everyone to CA Foundation Accounting Marathon. And trust me, it's a marathon only. Okay, it's going to be a long journey of few hours. Okay, few hours, yes. We start at what, now 7:30-ish. Okay, we will not end before 8:30. We will not end before 8:30. Don't even keep any expectations of it ending soon. Even if we finish at 8:30, I feel still we should have required like 1 or 2 hours more. That's what I would feel. But I think there are some issues with food and all, no? I see you. Okay. So now what are we here for? This is paper 1. I don't need to tell you. CA Foundation, paper 1. Now, is it very important to score in paper 1? Yes. Why? Because it's accounts, huh? What is the main goal? See, it's your first paper of your CA Foundation exam. Okay, it's all about momentum. When you go to your first paper and when the first paper goes well, automatic confidence is carried forward to the other papers. When first paper gets messed up, then you are going into all the other papers with pressure itself. Okay, many of you would be thinking that I have to score well in accounts so that I can compensate. Okay, that shouldn't be the thought actually. You should try to score well in every paper. Because we don't know, ICA, if you have noticed, every attempt, one paper will be tricky. One paper, we don't know which paper that is. Sometimes it is accounts, sometimes it is law, sometimes economics, sometimes it is quant. If you don't study, all are tricky. Okay, that I don't need to tell you. So, one paper will be there which is tricky. So, you can't go to the exam thinking that this I'll score more, this I'll score less. Clear? Simple. Before we start the marathon, some simple rules. Okay, one thing is, you have paid money for what to ICAI? For the course registration. You are going to pay money for what? For exam registration. I think you would have already done the exam registration by now. Okay, these are the two things you have paid the money for. For course registration, you got the books, your responsibility to study. Exam registration, you will be given answer papers, how many ever you want. Your responsibility to go and write. Correct? Are you also doing the job of the person correcting the paper? No, right? Are you doing that job? No. So, we have this mindset. We'll be like, this chapter I'll score 20 marks. This chapter I'll score 10 marks. This chapter 5 marks. Okay, I got 60. That let's not do it because we are not the ones correcting paper, right? Okay, are we doing the job of setting the paper? We are not doing the job of setting the paper. That means we can't tell from this chapter 20 marks will come, this chapter 5 marks will come, this chapter 10 marks will come. We can't do that prediction, right? Because we are not setting the paper. So that also let's rule out. Then, are we the ones ultimately declaring the result? No, we are not the one. So let's not do the prediction like 60 in this, 40 in this enough. Then 60 in this one, 40 in this. Yes, 200 I'll pass. Correct? Now, people, whoever has written before, okay, many of you have ended up in border. Have you ended up in border 170 plus, 180 plus? Some of you might be 190s. Okay, that's a very bad place to be in. Trust me, it's a very bad place to be in. If you get, you have to clear, you have to get 200, right? If you get 100 and you fail, if you get 100 and fail, then you know you can't blame ICA because ICA didn't do anything. If they cut 10 marks from each subject also, still you wouldn't have, if they give the 10 marks extra also, you wouldn't have passed, correct? So you can't blame ICA. You can't blame God also. God couldn't have done anything. Are you getting my point? So only person you could have blamed was yourself. If you get 100, but if you are in the border, then you have done your work. Maybe little more fine tuning would have been required. If you are in the border, then you will feel very bad. That's a very bad place to be in. If you are getting very less marks, right? Okay, 100 or below 100 marks, then you know you didn't study only. Just study. Next time you'll clear. Okay, when you are in border, no, you have done some small mistakes like doing predictions, doing selective study. Are you getting my point? Now I always tell in regular class, if something is not asked for a very long time it is not asked. Some topic is not asked for a very long time. Then it has high chance of being asked. Okay, you shouldn't skip that. If something is asked regularly, do you have the guts to skip that? No, right? That you'll anyway study. So basically, moral of the story, you have to study everything. Are you getting my point? Moral of the story is you have to study everything. There is no other option. But obviously, we are human beings. Everything we can't be master of. Everything we can't tell, we are perfect in it. Okay, some chapters we might be extremely strong, but those other chapters which we are not extremely strong also, we should know. Okay, we should be in a position to at least solve it 80% correct. 80% I can go, or if simple questions come from this chapter, I will get it 100% right. Maybe some major twists I might struggle. Okay, so there is no option of skipping. Okay, you have to study everything, trying to be extremely perfect in everything, but there might be some chapters you can't be perfect. Okay, we are human beings. 100% we can't be perfect. Okay, but you have to put in your effort of at least trying to be. Clear? One more major mistake that you guys are doing is thinking in your head that passing marks is 200. Thinking in your head that passing marks are 200. So something goes wrong. 170, 160, 180, 190. You'll be in this range if something goes wrong. But imagine, just imagine, 200 out of 400 is how much? 50%. Okay. Before this, you have written other exams in life. 10 standard, 12 standard. Tell me which other exam in your life you kept 50% as the target. Did you go to any other exam in your life thinking that I should score 50%? Enough. 50% if I score, I'm very happy. Did you go to any exam? Some of you would have gone to some other exams before this. Even 90% wouldn't have been happy, right? I mean, you would have scored 90% and maybe your parents would still not be happy about that 90%. Okay, so imagine you up your level and you take this 200 maybe to 250 or 280 or 300. 300 also you're like, oh, 300 sir, what 300 you're talking about? It's still 75%. It's still 75%. You wouldn't have been happy with this in 10 standard or 12 standard. Are you getting my point? You wouldn't have gone to 10 standard or 12 standard exam thinking that you have to score 75%. So still 300 is also the lowest target you have kept in your life before this. Compared to everything what you have done, this is your lowest target. Now imagine someone is targeting to score 300. Don't you think if ICA would tell passing marks are 300, you would have tried to get 300 only. You would have studied to score 300. And there if you would have failed, would you have been on 280? There if you would have failed, would you be on 270, 260, 290 and all? This is the same range where you are when you fail with 200. Correct? That means if you keep target, if you think that ICA has told that 300 is a passing mark, and if you study that way, if you fail according to your revised target, you will still pass as per ICA's target. Are you getting my point? So now recently they brought ranks back in CA Foundation. Okay, but for a very long time they had removed the ranks. In CA Inter there are ranks, right? The people who try for ranks, you know what is the worst thing that happens in their life? Worst thing that happens in their life. People who try for ranks, they don't get the rank. They don't get the rank, but they still pass the exam. Are you getting my point? Because people who try for ranks, they are keeping their target so high. What might happen? It's 50, right? In India. Inter ranks are 50. I think foundation they made it 20. Okay, 20 ranks. You might not end up in the 20, but when you have tried to reach the top 20, you cannot be in below 200, right? Is it possible? When you're targeting to score 350 and all, can you get 190 there? You might get 340, 330, 320, 310, still good enough. Are you getting my point? Trying to get a rank is just one what? Extra badge, that's it. Ultimate goal is passing the exams. Passing the exam, going to the next stage. Passing the exam, going to the next stage. Clear? So, let's begin this marathon. Okay, we are going to go in detail to a lot of things and we are going to solve some important questions. Solve means we are not going to literally write it. Okay, we are going to discuss the answer from the solution itself, whatever ICA has given. And the simple questions, silly questions, I am not taking it up, but when you study, you have to study. Okay, I am only going to the tricky questions where ICA has given bamboo. Clear? ICA's bamboo is there, that we have to see. Now, last revision is written, right? Is there anything written here? Full empty pages. Is there anything? No, this you are going to write. You and me, we are going to write. As we do each chapter, we are going to write certain things. Okay, those are the only few things you are going to write in class. in marathon, okay? You're going to write certain things where last minute, what are the must do things? For example, if I take a chapter like journal, what are the must do things I have to look at before going into exam? And those will be only the tricky things. Now don't use this last minute revision, whatever we are writing, for your preparation. It's not your preparation. Preparation, you have to finish all pages of study material, okay? There's no other option there. Okay, so here we are only going to discuss before going to exam. These are the topics I have to have in my mind. I have to look into it. And in accounts exam, you will have one pressure less. What is that one pressure less? Previous day exam pressure is not there. To revise everything in one day, that is not there. You will have it in law, you will have it in quant, you will have it in economics. You have to revise everything in 1.5 day. That is not there in accounts because it's the first exam. But you have one more new pressure. That is the first exam pressure. Going to the exam center, new place, new surroundings, new environment, new people, random people sitting next to you. Okay, that pressure will be there for the first exam. That pressure won't be there for second, third and fourth because you know that's your place. You got comfortable sitting there for 3 hours. So first exam always try to go a little early. Okay, maybe you can go like, I don't know, different cities you are writing in. Okay, I was always going to the exam on time because I don't want to talk to anyone. Okay, I don't want to talk to anyone. It's waste of time in the exam hall. Because someone will tell something, whatever they tell, it'll put you under pressure only. Someone will be there who will ask, did you study this? This will come in the exam. Correct? It will unnecessarily put you under pressure. So, I was staying in a small town. So, for me, traveling 10 kilometers is 12 minutes or 15 minutes. Okay? 10 kilometers away from the exam center I used to reach in 15 minutes. Because there is no concept of traffic and all. But here, you all have this traffic issues. So, plan accordingly. First exam maybe little early you can go. Other than that, all exams try to be there on time. Imagine you go early. I used to go sometimes reach early 5 minutes, 10 minutes. I used to stay outside the exam center. Some random Iyengar bakery will be there. Just go there. Okay, stand there for some time. Then when it's time, right, I used to just enter. Okay, because I don't want to talk to anyone. Because if you talk, you know you'll be under more pressure. Straight away go to the exam center and I should not carry book also to the exam center. What you couldn't study in 3 months, what you'll study in half an hour. I'm getting my point. What do you study on the exam day there? Okay. If you have a long travel time, no, like 2 hours, 3 hours and all travel time, then you carry some book just for revision. But if it's like half an hour journey and all, just go. Just go straight to the exam. Don't carry book because you will feel like seeing every page. Outside the exam, you will feel like I have to see every page. Okay. Just go there. Sit there. Find your place. Sit there. Maybe like say a prayer. Calm yourself. Do whatever makes your mind calm. Okay. And after the exam, again, don't meet friends. Don't meet friends. What are you going to do? Are they going to correct your paper? No, right? They will always tell something. Okay. Which will put you under pressure for the next one. For you, exam was damn easy. Okay. Very easy it was. You felt like every twist I was able to identify. ICA gave so many twists. I identified everything. But your friend, no, someone, for him, he was like, exam was tough, right? Now your easy also will become tough. You're like, for him it was tough. That means maybe all the twists I saw ulta. Why? How was it tough for him? Correct? Whatever it tells. Now imagine for your exam was tough. And your friend tells it's easy. For him also it was tough only. But he just told you it is easy. Then you are gone. There is that rule, no? If friend fails and you also fail. Okay, or if friend fails and you just pass, you'll feel little sad. Okay. If you fail and friend tops, you'll feel very bad. Correct? Three Idiots movie. Okay, so there are some people, for them it would have been tough. Simply they'll tell it is easy. Okay, now you will get affected. Basically, whatever they tell, you'll get affected. So after the exam, just make one proper laddu out of that question paper and throw it somewhere. Okay, focus on the next paper. What will you do? Can you change things? No. Okay, so that's how it should be. So let's start our last minute revision. We are waiting for you only, man. Finally, you arrived. Yes, so now, chapter number 1, here and there, as we go further, we will discuss chapter number 1. We start directly with chapter number 2. Okay, accounting process. Accounting process is very important. is very important. Now I know some of you will ask, sir, very important, then how much marks will be asked from accounting process before rectification? Nothing. If you are lucky, maybe 4 marks somewhere here and there they will gift you, but otherwise nothing. But you know how much marks it is actually? 100. You know how much marks? 100. Especially chapters like rectification of errors and all, you will not be able to solve if you are not strong with accounting process. Clear? Now, first we will start with journal. Okay, just write last minute revision. Keep on paper, keep on page just for this. We'll keep filling it over a period of 2 days. It should have everything that you have to look at without fail before going to exams. Now, only journal I'm talking about. Ledger now I'm not talking about only. You are expected to know ledger. Clear? So journal, or if I tell, instead of journal, if I call it as accounting process. Accounting process. Okay, first thing you are supposed to do in accounting process is journal, and first thing in accounting process, everything, journal, ledger, subsidiary books, everything. Okay, concepts. Read the concepts. There will be some certain concept books which I have written in class and which I have prepared otherwise. All that from which I will be discussing in this marathon. Everything will be shared. Okay. So online students, don't keep asking me, will it be shared and all? Everything will be shared. Whatever we discuss in class will be shared. Clear? So now, accounting process, first thing you have to do is the concepts. What concepts? Everything. Everything. When I'm telling concepts of journal, concepts of ledger, concepts of trial balance, concepts of subsidiary books, concepts of cash book. Clear? These many things. Rectification is a separate topic. I treat it as a separate chapter only. Okay, we'll discuss rectification in detail. Now, concepts of all this you have to discuss in detail. Okay, you have to study in detail. It might not be asked in the exam, but it will impact you in different areas of CA Foundation accounting subject. Clear? Now, first we'll talk about journal. Only journal here I'm talking in detail. Other things I'm not even going to discuss. Ledger and all, just concepts we are going to discuss. No problems are going to be solved. Okay. Let's begin. Now, accounting, importance, all this you know, that's why you are here. Okay, by now you know what is the importance of accounting and all. I'm not going to discuss. You're supposed to find the result and you're supposed to find the position. What is the result? What is the result? Profit or loss. Okay, what is position? What do you call as balance sheet? Clear? Now, imagine someone is having a tea shop and all that. Okay. Now, directly we'll come to accrual concept. What is accrual concept? It is not chapter 2, it is chapter 1. But you need it. What is accrual concept? Only when I get money or when I pay money am I going to pass entries? No. Transactions are recorded as and when they happen. Not necessarily only when amount is paid or received. Clear? Simple topic. Accrual concept. You should know it. Okay. Transaction. You're like, what is transaction? An event which has monetary effect. Anything that has monetary effect is called as transaction. And anything means that happens in business only. If you are having business here and in the side road something happens, you are not bothered about that. But from that, imagine you are having business here and in the side road there is a fire. Are you bothered about that? No. You'll just read it in news. Correct? But in that side road, that fire, the smoke, it has come and it has spoiled the paint of your building. Now is it going to affect you? Are you going to get my point? Only things which are affecting your business, that's what you're bothered about. Now, accounting process. We know we start with journal. Do you have an alternative for journal? Subsidiary books. In subsidiary book only, we have also cash book. Cash book is not exactly subsidiary book, but it's like subsidiary book. Okay. These are the things. Either journal you'll do or you prepare subsidiary books. Then you move on to ledger. Then you move on to trial balance. Clear? This is your accounting process. This is your accounting process. And this is your final accounts. This is your final accounts. Preparation of financial statements. Trading account, P&L account, balance sheet is what you're going to do. Or that was your motive. That was why you are here for. But you started with this. Without doing this, you can't reach the next stage. Is it clear? Now, when we are talking about journal, what is journal? Primary book of accounts. What does it mean, guys? Primary book of accounts? That means the first book where you enter anything. It is the first book where you enter anything. Clear? Books where transactions are recorded. How are you going to record the transactions? Chronological order. That means date-wise. Clear? Now, debit, credit. Usually I ask, what is debit, what is credit? Actually, there is no meaning for debit and credit. If you have thought of, it is just left side of the ledger is called as debit, right side of the ledger is called as credit. Now, if you ask me, sir, why can't the left side be credit and right side be debit? Can we do it? Can it be? Is there any specific strong reason that left side has to be debit or why left side is debit? No. No accounting standards for this. No accounting standards. Accounting standard will tell you when to debit, when to credit. Practice of many years. It's a convention. That's it. Many years they kept practicing like this. It became it got continued like that itself. Now you don't go to change. Especially in the exam hall, you don't go to change. Are you getting my point? So debit and credit actually have no specific meaning, but by our entire life is about when to debit, when to credit. Our entire life is not about what is debit and what is credit. Entire life is about when to debit, when to credit. You get that right, accounts is done. Are you getting my point? You are thinking, no, sir, debit, credit, I have to think only when I'm in journal entry stage. Other stages are all not required. Partnership and all, I don't have to bother. Their ledger only they ask. Trust me, if you get the concept of debit and credit right, every single chapter, every single topic, you can't go wrong. Maybe in BRS, there is no debit credit. Did you put the amount there? Did you put the amount here? Correct? So, entire accounts is about debit credit. It's two sides of a transaction. Now we talk about dual aspect concept. What is dual aspect concept? That means for every debit, there should be one credit. Never leave the debit alone. The debit will feel left out. Never leave the credit alone. If you leave the debit alone or if you leave the credit alone, then our journey will go into rectification of errors. Are you getting this? So for every debit, there should be one equivalent credit. Now, asset, income, expense, liability. You know all this. Quickly we'll recap. What is asset? Anything that gives us benefit in future. What is liability? When you have an obligation or responsibility on your head to do anything. Clear? What is income? Any benefit earned. What is expense? Any benefit taken from other party. Clear? This is what you are supposed to know already. Now, this is a very important discussion. It can impact your final accounts also, NPO also, incomplete records also, so many other chapters. Outstanding expense. What is outstanding expense? Liability. Outstanding expense is a liability. Why? Because you are supposed to do something which you haven't done. You are supposed to deliver something you have not delivered. So, benefit received but amount is not paid. Examples are like electricity bill unpaid, outstanding salary, rent unpaid, all this. Okay. Prepaid expense. You are a good guy. Before you are supposed to do only, you went and did it. Clear? Benefit not received, amount paid in advance. Benefit you are going to get in future, but you have already paid the amount in advance. That is salary of April, May, June, paid in March. Clear? Income receivable. Asset. What is income receivable? You did your work, but you still didn't get the money. So you don't have any extra thing to do. Other person has to deliver whenever anything is receivable. Asset. Clear? Benefit given, but amount is not received. Now, income received in advance. Liability. Why? You got the money already, but you haven't done your work. What is your work? To go and complete your responsibilities. Okay. Somebody gave you money and told that next 1 year I want to stay in this building which belongs to you. But have you given the building yet to them? No. That means you have an obligation. So, income received in advance will always be considered as liability. Clear? Now, sale. Whenever we are talking about sale, we have two types of sale, credit sale and cash sale. What is credit sale? Goods are sold, amount is not received. What is cash sale? Goods are sold, amount is received. This is like 11th standard first day. Correct, no? Purchase. Purchase also will have credit purchase and cash purchase, same topic. Discount. Very, very important. It can impact many places. Discount. You feel it's a very small topic, but suddenly somewhere in rectification or somewhere else discount comes, we are not sure what to do. Okay, discount, we have trade discount. Trade discount completely ignore. Completely ignore. That means there is no journal entry for trade discount. If there is trade discount, reduce it and pass the entry for reduced amount. You know what is trade discount? You went to a shop. When you entered, you saw the board like this. ₹1,000 now at 200. Now, are you going to pass the entry for 1,000 or are you going to pass the entry for 200? You're directly passing entry for 200. 1,000 has no relevance at all. You're not entering it at 1,000 and reducing it to 200. Are you doing that? No, directly 200. Clear? But later on when you go to counter, you got some reward points or cash back. Okay, now what happens? Or you made the payment 200. Next day you got 20 rupees back. Is this a discount now? Yes, that is cash discount. So basically trade discount is discount at the time of trade. That means at the time of buying or selling. Cash discount is discount at the time of payment. Payment means what? At the time of paying money or at the time of receiving money. Clear? Discount at the time of trade, no entry for discount. But whatever cash discount we are going to discuss, there are two types. Discount allowed, discount received. Simple. Whenever you're getting confused about discount allowed or discount received, remember that if you're paying money, that means money is going out. That means discount has to come in. You're going to receive discount. Okay, if you're receiving money, that means money is coming in. That means discount has to go out. That means you have to give discount. Discount allowed. So discount allowed is discount at the time of receipt of money, expense or loss. If you give discount to somebody, is it a good thing for you? No, you lose money. Discount received is discount at the time of payment of money, income or gain. Is it clear? Now, drawings. Many places is going to trouble us drawings. Okay, what is drawings? What is drawings? There is one company, okay, like this. Okay, one guy started this. One guy started this. Is this a business his? Is this business his? Whatever is there inside this building, can he take it? Can he take it? There is some money kept over here. Can he take it and use it for buying pani puri outside? Can he do it? Yes. Yes or no? No. Why? Separate entity concept. You feel, right? Owner only, sole proprietor, his only everything. He only put money. He only should get everything. Correct? You'll think like this, right? In accounts, we follow entity concept or separate entity concept. What does it mean? Business and business person are always two different entities. Business and business person are always two different entities. Now, books of accounts prepared for whom? Business. Not for business person. Books of accounts are prepared for whom? Business. So that's why we come across the concept of drawings. Drawings means what? Whatever owner takes, which belongs to business for personal purpose. Clear? Anything belonging to business used for personal purpose. It can be in cash, it can be in goods, it can be in asset. If it is in cash, what happens? Amount belonging to business used for personal purpose. If it is goods means what? Goods, the things which you are actually selling, that he has taken for personal purpose. What is asset? Asset which is supposed to be used over here in the business, that he took it home. Clear? This is asset used for personal purpose. All are considered as drawings itself. Clear? Next, capital. What is capital? Drawings means he is taking money. That means capital means what? He is putting money. So amount or asset introduced by business person into the business. Liability. Oh ho ho ho. Why? We are thinking from whose point of view? Business point of view. So for business it is always liability. Maybe for the business person it is asset. Because he has put money. Correct? It is asset. He has put money, he has to get returns. But for business it is liability because somebody gave money. Whenever they ask, we are liable to pay that money back. Clear? Free samples. What is free samples? You will see it many places. It is actually advertisement. Clear? Imagine I am manufacturing biscuits. Okay? I am manufacturing biscuits and whoever comes on that road, I am giving them 2 packets and tell, enjoy. Okay? Have fun. Whoever comes, I am giving them 2 packets. Why? Am I doing charity here? No. If they like the biscuit, next time they come on this road, they'll buy the biscuit. Are you getting my point? So whenever there is free samples, it is advertisement. Okay, and it is expense. Or you can also call it as loss. Donation. What is donation? Here I am not expecting someone to buy. Here I am doing it as a charity. So that is also expense only for me. whether I give it for free, expecting them to buy, whether I'm giving it for free, just for their well-being, both are expense for me. Clear? Now, how to pass journal entry? This you should know by now. We have two approaches, traditional approach and modern approach. Whichever approach you are following till now, just follow that. Just follow that. Okay, don't go to change now. But I would always prefer modern approach if you're starting fresh. Okay. Traditional approach has classifications. You can get true or false questions. All this you can get. Tell me, traditional approach has classifications. Real account, personal account and nominal account. What is there in real account? Usually assets. Okay, usually assets, and it is non-current assets. Non-current assets. That means long-term assets. They fall into real account. But classification of real account always depends on the classification of personal account. First you decide something whether it is personal account, then you can think of other things. Personal account means what? Anything related to persons. It can be natural, artificial, representative. Natural person means what? Human beings. Artificial person means what? Companies, partnership firms. Representative person is what? Capital or drawings. Some of the examples for these. Nominal account is what? Expense, loss, incomes and gains. Okay. Modern approach is pretty simple. In modern approach, what happens? You have assets, liabilities, expense, income, capital or drawings. Clear? What is the rule for traditional approach? You need to know the rule even if you are not following it. What is the rule for traditional approach? Real account, debit what comes in, credit what goes out. Personal account, debit the receiver, credit the giver. Nominal account, debit all expenses and losses, credit all incomes and gains. Clear? Modern approach, simple. Asset increase, debit, asset decrease, credit. Liability increase, credit, liability decrease, debit. Expense increase, debit, expense decrease, credit. Incomes increase, credit, incomes decrease, debit. Capital increase, credit, capital decrease, debit. Okay, if you are all anytime confused, asset and liabilities are opposites. Expense and incomes are opposites. And liabilities and capital are same. Liabilities and capital are same. Because capital is also one form of liability only. But still, why are we calling it separately? Liability, when I tell liability, no, it is outsider's liability. That means what I'm supposed to pay, outsider. When I tell capital, no, that is also liability. It's insider's liability. What I'm supposed to pay, the insider, that is owner. Clear? Transactions. This and all will not discuss. All examples and all will not discuss in marathon. Yes, this thing we have to discuss. Periodicity concept. What is periodicity concept? Anything related to a particular period should be recorded in that period itself. Anything related to a particular period should be recorded in that period. So any income or expense related to a particular period has to be recorded in only in that period. Clear? Now, next we'll go into format of journal. Do you know the format of journal? Very important. Should we follow the format of journal when we have journal entries asked in exam? Any chapter they ask journal entry. Should I follow format of journal? Answer is yes. You can lose a mark. You can lose a mark, and that mark is very important. It can be the difference between September and Jan and May and September. We don't want that, right? Okay. CA means what? It should be that only. Okay. It shouldn't become again. CA means Chartered Accountancy only. Okay. So this is the format. Date, particulars, LF. LF is a column which will forever be alone. Okay. We will not enter. Forever alone it is. Okay. Debit and credit. What is LF but? Ledger folio. Page number of the ledger. Okay. Narration. Is it important? Wherever. I am not going to tell you. I am not going to explain narrations also to you in this marathon. Even in regular class, we hardly discuss about narration. Narration has to be there. Has to be there. Are you getting my point? Now you are like, sir, what if exam paper is lengthy, sir? What to do? You know how much space is required for narration, right? Leave and try to complete the paper. Try to complete the paper. Later you see 10 minutes remaining. Search wherever you have not written narration, right? Go and write narration. You will still be able to write. When you see the entry, you will know why you passed the entry. Just write being and write. Are you getting my point? Being and then you'll write. Okay. Now, is it possible that you get the entry right and narration wrong? It's not possible, right? You saw purchase account debited to X. You have written an entry, purchase account debited to X. Can you go and write B, sale made to X? Is it possible? You are seeing purchase account, right? Then you are writing narration, you will get it right. Okay, they are not that critical that you didn't give complete narration, so I'm going to cut marks, nothing. Okay, narration should be there as a part of the format. Now, sometimes in company accounts and other places and all, they tell ignore narrations. If there are too many journal entries like 15, 16 and all, they tell ignore narration. Unless and until you see those words, always narration is required. Clear? Yes. Yeah, wherever you pass journal entry, narration is must. How much will they cut? 10 journal entries are there. That means 10 narrations are there. You did not write any narration. How much marks will they cut? 10 mark question it is. How much will they cut? 1 mark, okay? It is not 1 mark per narration. Now, don't act over smart. Some people are there, okay? Extremely smart. They're like, sir, I can't remember the journal entry. I will write only narration. I can't remember journal entry. I'll write only narration. Is it possible? No. Narration is valueless without journal entry. I'm telling you. Narration is valueless without journal entry. Just like balance sheet has no value without the numbers. And just writing fixed asset and all those things. If you write and come, you will get 0. Are you getting my point? Same way, format is valueless without writing anything inside that. You're like 2 minutes are remaining. I will draw journal format and keep for this question. Let's see whether they'll give me 1 mark for that. Maybe these kind of tricks worked in 11th and 12th. Okay. Just for format and all, they used to give marks. Okay. Here it will not work. Don't do all that. Yes. In fact, if you have time constraint and you're doing the last question without the journal format also, at least write journal entries in the books of and write the journal entries. They might cut 1 mark for format. At least the 9 marks for writing the journals you'll get. No. Are you getting my point? Imagine last moment you don't have too much time. Taking your scale, drawing lines. Okay. By that time over, they'll snatch your paper and go. Okay. So, should you be extremely neat? No. Should you be presentable? Yes. Should they be able to understand that you have written in English? Yes. That's enough. Okay. Anyways, your language is going to change, right, as you go further. Starting, you'll start in English only. Ending, you'll go to some other language. First page, you'll be writing neatly like this. Last page, you'll be writing whatever. Correct? When you hear that bell ring and all, no, half hour left and all, you'll be writing whatever you want, you'll write. Okay? So, it should just be presentable. They should be able to read it. That's it. That's more than enough. Now, let's go into one more concept. Accounting equation. What is accounting equation? Asset is equal to liabilities plus capital. Sir, total bakwas, sir. Same thing we do in balance sheet also. This total bakwas thing will help you in many places. And you won't even believe this total bakwas thing will help you even in a place called partnership. Even in a place called partnership. Making capital proportionate. You will not know how much is the capital. You will use asset is equal to liabilities plus capital and you will find the capital and make capital proportionate. So it's very important. You know, asset includes fixed assets and current assets, and liabilities include long-term liabilities and current liabilities, and capital is capital. If in between all these circles you find drawings, it will get subtracted from capital. Clear? Going concern concept. What does it mean? Business will go on forever. Okay, people may come, people may go, but business will be there. That means we have no intention or indication that business will shut. We don't have plan of shutting it. We don't see it shutting on its own also. Clear? No examples. Okay, these are all silly examples, and marathon it's too silly. Let's not even think about it. Yes, this format I want you to remember. Capital. Okay, it will help you in multiple places again. Opening capital means what? Capital which is there at the starting of the year. Now you have to understand when can this capital increase, when can this capital decrease. Okay, additional capital introduced. Capital increases. Profit for the year. Capital increases. Loss for the year. Capital decreases. Can both of these be there in the same question? No, you can either have profit or you can have loss. Drawings, what will happen? Capital decreases. Is this clear? This is your closing capital. Now tell me one thing. Year 1, capital is 100. Year 2, capital is 150. No additional capital is introduced. What does this 50 mean? Profit. Which year? Year 1 or year 2? Year 1 or year 2? Year 1 or year 2? Very good. Year 2. Year 2. When I am telling year 1 capital, where did you find it? Was it displayed on the hoarding outside? No, where did you find it? In the balance sheet. When did the balance sheet get prepared? Last day of year 1. Last day of year 1, if capital is 100, How can the profit be in year 1 when the capital became 150 in year 2? Last day of year 1, you saw the capital as 100 and you closed the shutter and went. Then last day of year 2, you are seeing the capital as 150. Can you make profit in year 1? Are you getting this? If capital increases due to profit, that has to happen in the subsequent year only, no? When you are telling capital of year 1, capital of year 2, you are seeing balance sheet. Balance sheet is on the last day. Are you getting this? Okay, so remember that. Ledger. You should know this, guys. Okay, you should know this. If no, should not have any doubt. Secondary book it seems. What does it mean? Primary book was already there, no? Now high school. Clear? Secondary book, ledger. Whatever is there in journal will get transferred to ledger. It is a book where all journal entries are posted. What is posting? Just transferring debit and credit items from journal to respective ledger. Maybe some 5,000 times in your life or 10,000 times in your life, you have done this posting. Okay. Some places where they ask only ledger also, you're doing posting only. You're telling the journal entry in your mind and doing the posting. Some people don't even think of the journal entry. They directly write to buy. Are you getting my point? Okay, that will not be a good approach because when you do just 2 by, no, suddenly that same question comes in the exam, pass journal entries, you're stuck. So if you tell journal entries and post it, that time you will be able to do both things asked in the exam. Now, after that, we have to discuss one more topic called as, I can't find where I've written it. Balancing. What is balancing? Finding the difference between debit side and credit side of the ledger and carrying the balance forward. Correct? Now, if you have ledger like this, I have 100 over here, I have 20 over here. Where should I write the balance? I should write 80 over here and write by balance carried down. That means this ledger has debit balance or credit balance. Not credit. But I wrote in credit side, no. That is just to push it down. So this ledger has debit balance. Clear? Okay, we shouldn't have any other issues. This is very, very important. I'm telling you, this is very, very important. If at all in journal, is there anything that I have to discuss in detail? That is this. Now, go and write in your final revision, journal, okay, whatever you have written, no, journal, write over here, GST journal entries. GST journal entries. Okay, then you write question number, question 8 and question 9 from study material. Question 8 and question 9 from study material. You have to see this before you go to exams. Okay. Ready, guys? Now, let's discuss GST. What is GST? Goods and Service Tax. Full GST we are going to discuss today. Then why are we going to see enter? Why are we going to see a final? If full GST we are going to discuss here, why are we going there? We are learning nothing about GST actually. Let me be frank. We are learning nothing about GST. We are only telling if somebody gives me GST rate. Already they give me GST rate. How to pass journal entry. That's all. What is GST? You will learn it at lunchtime and you will learn it at dinner time. We are only at breakfast time. Clear? So now what are we supposed to do? Understand the concept of GST and pass journal entries. Now imagine we have one person over here. Okay, we have one person over here who has manufactured goods. Clear? And that person will transfer the goods to, sell the goods to one more person. Clear? Samra. Taman and Samra, two people are there. They'll transfer, one person will sell the goods to other. Now, Taman is telling my cost is 100. And to that I will add the profit. And my selling price becomes 120. How much is Taman's sales? 120. How much is Taman's sales? 120. It cannot be 100. No, cost is 100. Are you getting it? 120 is the sales. But can he just sell it at 120? No. When he's selling, he'll tell, let me add CGST. Let me add SGST. What is CGST? Central Goods and Service Tax. What is SGST? State Goods and Service Tax. What is IGST? Integrated Goods and Service Tax. Okay, just for your knowledge, when you are selling within the state, these two will be applicable. When you are selling from one state to other state, that time IGST will be applicable. Okay, what happens? All that you study at C Enter, that also at Marathon State, will not discuss it. Okay. Now, understand this. Why we have to write CGST on top? Central is on top, right? State below. Clear? More powers with them. So central goods and service tax, then you'll write say state goods and service tax. Is it clear? Now, you will add this. Rate will be given to you in the question itself. You are not expected to know the GST rate for which one. Because people who are studying CA Inter and CA Final also might not know. Because you don't know, suddenly Nirmal aunty will come and tell one new GST rate is applicable. Are you getting my point? Popcorn only, she is not leaving, no. In popcorn also 2 popcorns. Normal popcorn, different GST rate. Caramel popcorn, different GST rate. You know caramel popcorn, but the one which you can't complete. Okay, you will take, but you will not complete it. Because it is too sugary. Okay, it will get stuck in your mouth. After a point, you will be like, you just want to get rid of it. Because you have paid more than the movie price, no? To get that popcorn, you have paid more than the movie price. So obviously, you will want to finish it off. Okay, now. Cost is 100, you have added profit. This is your GST rates. Yes, guys, let's continue. So now tell me one thing. Can you see this 141.6? Is it after adding GST? Is it after adding GST? So does it mean that full 141.6 I'll keep in my pocket? No, I'll keep only 120 in my pocket. And I am going to be Nirmal Auntie's agent. And I'm going to collect this 10.8, and I'll go and honestly give it to Nirmal Auntie. Is it clear? I am not going to mess up this 10.8, then I'll be in deep trouble. Clear? This I'm just an agent for the government. I'm collecting it and I'm going to give it. Clear? Whenever you have sales, if there is GST, it's called as output GST. Whenever there is sales, if there is GST, a quick tip to remember, goods are going out, output GST. Goods are coming in, input GST. Clear? Output, input, what is the logic? You can adjust with each other and pay only the net amount to government. Okay, now look at Samra's angle. She has purchased the goods for how much? 120. What is sale for one person should be purchased for the other person. So 120 is the purchase. Clear? And on that there is GST, and for her it is input GST. Input GST. Clear? Now, what will Samra do? She will pay this GST to Taman, and what will Taman do? Pay this GST to Nirmal Auntie. That's it. Are you getting my point? Now, what if Samra now sells it to one more person? If Samra sells it to Sana, don't go by the hairstyle, it's amazing. Okay. Now, if Samra sells it to Sana, is this her cost? Is this the cost? 120 plus 10.8 plus 10.8. Okay. Now, her cost is 120. To that, she'll add again profit. Because she'll not sell it at the same price, right? She'll add profit of 30, and now the selling price becomes 150. Clear? On 150, she'll add GST. Now she is the agent for Nirmal Auntie. She is the agent for Nirmal Auntie. She'll collect it from the next person and she'll pay it to the government. But when she's paying to government, no, she'll remember, I had given to somebody GST. Can you see 13.5 over here? And she has already paid 10.8. So if she's paying to government, she'll pay 13.5 minus 10.8. That's it. To the government. Whatever the balance you get, that you'll pay to the government. This is the logic of GST. That means if one item, imagine I sold this item and I started from here, first person in the bench. I sold to him, adding 10 rupees profit. He sold to the next person, adding 20 rupees profit. And every person we have sold, and it is coming back to the 50th person, let's assume. 50th person. Every person has sold to the next person. Finally, it has come to 50th person. Who is paying GST, you know? 50th person. You know who is paying GST to the government? 50th person. Every person, what he has done? Collected from the next person. Okay, whatever he has paid to the previous person, adjusted it. And it keeps going further. But the last person in the chain, the person who eats the product, that person is the person who is supposed to pay the GST. So always GST is paid by whom? Consumer. Okay, guys. Now, at the end, consumer pays the GST. Let's understand. Amount to be paid to government, output minus input, only in true or false they can ask. They cannot ask computational questions on this because they have not taught you computational. Clear? Now, in GST, there is an important discussion which you have to understand. List price. Okay, they will use this terminology called as list price. What is list price? Maximum retail price. You have gone to shops, right? Not to supermarkets. To shops, normal grocery store. When you go to that grocery store, you'll buy a lot of things and then come to the counter. In the counter, one guy will be sitting doing billing. In that, when he's doing that billing, he'll have a long list of things. Whenever you ask price of something, he'll see that list and tell. But he has seen your face many times. So because he has seen your face many times, whatever is there in that list, he will not give you that price. He will give less. He'll write, okay, 58. Let's make it 50 for you. Does he do this? Correct. That means what is there in that list is maximum retail price. Clear? Price of sale or purchase is after discount. Clear? This topic will be there in your GST related journal entries. 1 or 2 are there. Okay. Now, what is trial balance? Shouldn't have problem at all. What is trial balance? List of all ledger accounts and their balance. Okay. From journal ledger, it goes to subsidiary books, and trial balance like a bridge between previous stage and next stage. Okay. Using trial balance only you will be doing final accounts, right? Later on. Okay. Now, methods to prepare trial balance: total method, balance method, total and balance method. What is total method? You will just write totals of all ledgers. You will write debit side total, you will write credit side total. Okay. Balance method, you will just write the balance, debit balance or credit balance. Total and balance method is merger of both the methods. Clear? Format and all you should be knowing by now. I am not going to discuss that. Golden rule to prepare trial balance. You should know what has what balance. Now, trial balance can be asked in the exam. Sometimes, rare event. But they will not ask you to prepare trial balance. What they might do is, they'll give you one wrong trial balance and they'll tell correct the trial balance. To correct the trial balance, in fact, the wrong trial balance which they will give you, right, that will be tallying. That will be tallying. This error later on we'll see as compensating error. Clear? Now, assets have what balance? Debit. Liabilities have what balance? Credit. Incomes have what balance? Credit. Expense have what balance? Debit. Capital has what balance? Capital same as liability, so it should also have credit balance. And drawings is opposite of capital, so it should have debit balance. Sir, will they specifically ask use traditional approach? I am comfortable with modern approach. They will not tell you pass journal entries with traditional approach. They'll just tell pass necessary journal entries. Only thing of modern traditional approach which you might require is somewhere theoretically they ask some question on traditional approach. Clear? Now, bank OD and all, you know what is bank OD? Bank having negative balance, bank overdraft. Okay, suspense account. What is suspense account? You did everything, but it's not tallying. What to do? You don't know why it's not tallying. Do you know why it's not tallying? No, right? Suspense. When will that suspense tell bye-bye to you? Whenever you go and do rectification of errors properly. Are you getting my point? Rectification of errors, if you do, that suspense will be gone. Now, provision. What is provision? Amount kept aside for a particular reason. Amount set aside for particular anticipated loss or expense in future. Okay, this is called as liability. When you keep money aside and tell this is for buying a new phone, that means you have an obligation to use that money for that purpose itself. It becomes liability. Is this clear? Now, what is conservatism, guys? What is conservatism? Record all anticipated losses, but do not record anticipated profits. That means future profit, you don't go to worry about it, but future losses, 100% you have to get ready and prepare. Okay, let's not see the example also. Carriage outwards, carriage inwards. Carriage outward, carriage inwards. A lot of people have a lot of confusion regarding this carriage outward, carriage inward. Just remember this. If you're telling bye to the lorry, it is carriage outwards. If you're telling hi to the lorry, that means it is carriage inward. Is this clear? When will you tell bye to the lorry? When the goods are going out, that means it is sales. When will you tell hi to the lorry? That means goods are coming in, that means you're purchasing. Is it clear? Carriage inward, carriage outward. Which one is expense? Which one is not expense? Both are expense. Both are expense. But only thing is, carriage inward will go to trading account or sometimes to manufacturing account. Carriage outwards will go to P&L account. That means carriage inward is a direct expense and carriage outward is an indirect expense. Is this clear? Now, same way, what is returns inward? What is returns inward? Returns inward is what? When you are telling hi to the returns. When can you tell hi to the returns? When you had told bye to the returns before. When you had told bye to the goods. That means goods which went out is coming back. Returns inwards. Sales return. What is returns outwards? Purchase returns. Is it clear? Okay. And purchases are usually expense debited. So purchase return should be credit. Sales usually income credited. So sales return should be debit. Clear? Next we'll go into subsidiary books. Subsidiary books. What is the importance of subsidiary books? Okay. Alternative for journal. Now the subsidiary book, right, it will play a very crucial role in rectification. It will play a very crucial role in rectification. They'll just tell entered in this book. That's it. You are supposed to understand how they entered, what is the impact. Okay. It is an alternative to record any transaction that is repetitive in nature. Types of subsidiary books. Can you tell me the types of subsidiary books? Purchase book, purchase return, sales book, sales return, bills receivable, bills payable. Can be anything. Okay. You can add anything. Any number of subsidiary books you can have. Whichever is repetitive you feel, you can create a subsidiary book for that. Now, let's go into purchase book. Only the concepts of purchase book we are going to discuss. All credit purchases. All credit purchases of what? Goods that are dealt in business. All credit purchases of goods that are dealt in business. That means if this person, Ayan, is doing computer business, then buying and selling of computer is part of his business. So if he purchases computer on credit, it will go to purchase book. If he sells computer on credit, it will go to sales book. Clear? If he purchases computer for cash, cash book. If he sells computer for cash, it will go to cash book. Clear? Computer is business. He purchases furniture for cash. It will go to cash book. It will go to cash book. He sells old furniture for cash. That will also go to cash book. He purchases furniture on credit. It will not go to purchase book because that is not his regular goods. So purchasing furniture on credit, furniture is an asset. Asset purchased on credit will go where? Journal proper. Clear? And if he sells furniture on credit, what is his business? Computer. So it will go to journal proper. So what you can't enter into a subsidiary book will always go into journal proper. At the same place I have discussed purchase book and sales book both. Now I am going to discuss at the same place purchase return also. Purchase was entered in purchase book. Purchase return has to go into purchase return book. Are you getting my point? That means purchase was credit purchase of goods. That's why it went into purchase book. When those goods are returned, that will go to purchase return book. Sales were credit sale of goods. It was entered in sales book. When it is returned, it will come back and sit in sales return book. Is this clear? If purchase was made for cash, it has gone to cash book. Purchase return also will be for cash only. It will go to cash book. Same with sales return also. Okay, that should be it. Now, very important thing is the format of subsidiary book. You know how to do the format. Now, why two rupee column here? One for doing calculation and the final amount will go into the outer column. When you have a subsidiary book, let's say this is purchase book. You will write many parties. Many parties names you will write and finally you will get one amount. This amount, where will it go? Where will this total of purchase book go? Very important from rectification point of view. Total of purchase book, where will it go? No, it will go to purchase account. It will go to purchase account debit. Purchase book total will go to purchase account debit side. Sales book total will go to sales account credit side. Same with purchase return and sales return also. Is this clear? But where will this line item, if I write A, B, C, it will go to respective ledgers. In purchase book, the parties that are sitting are debtors or creditors. They are creditors. Purchase means they are creditors. So it will go to the creditors ledger credit side. Now understand this. If I tell that I have entered something wrong, I have entered wrong, that means it will affect the parties also. It will affect the total also. So error will be on both sides. Clear? Okay. Both sides there will be error. Now if I enter the amount correctly, but I made a mistake in total. Now will that affect the party over here? No, it will affect only the total. So that will affect the purchase account. Is it clear? So this is very important from rectification of errors point of view. Now sales book and all I'm not discussing. I already discussed with that itself. Cash book. All things up to rectification at one point only will finish it off. Cash book. What is cash book? All cash transactions. Cash means not only cash. It can be cash and bank. Clear? We'll discuss that. Okay. Sir, some items like rent and rates are getting confused whether it is received or paid. They have to tell. If they tell, for example, rent, no. If they just tell rent, it's always expense. Okay. If they tell rent received, then only you take it as income. Otherwise, rent, if they tell, it is always expense. Clear? Now, cash book. It is a book that records receipts and payments of cash and bank. Types of cash book. Single column cash book. Single column cash book means which column is there? Cash or bank. It can be cash column or bank column. Imagine I don't have cash transactions at all. Then it will be a bank column. Okay, 2-column cash book. It can be cash and bank column, or it can be cash and discount column. It can be bank and discount column. 3-column cash book. Cash, bank and discount columns. Is it clear? Petty cash book. Records all what? Petty cash transactions, small cash transactions. Okay, when you have a petty cash here, then petty cash book will be prepared. Now, discount column. In cash book, very important rule for discount column. Do not balance it. There is no balancing of discount column. Left side discount, debit side discount, total it. Credit side discount, total it. Debit side discount means what? Expense. So it is discount allowed. Transfer it to discount allowed ledger. Credit side discount means what? Income. Transfer it to discount received ledger. Is this clear? Now, cash and bank column always balance it and transfer the balance to what? Trial balance. Purchase book total will go to purchase account. Sales book total will go to sales account. Purchase return, sales return also will go to respective ledgers. But cash book, the cash and bank column will go straight to trial balance. You know why it will go straight to trial balance? Because cash book is almost like ledger only. Is there any difference in look from cash book to ledger? It looks like ledger only. Debit side receipts, credit side payments. Clear? Now, if cash book is prepared, there is no cash account or bank account. No need to prepare cash account, bank account. Again, it will have the same transaction. So, straight to trial balance. Okay, now check received is a very important discussion. It will impact where? Here as well as BRS. As well as BRS. In check received, okay, if it is deposited on same day, no problem. If it is deposited on same day, what will you do? Bank account debited to party account. Whoever gave you the money. Bank account debited to party account. Imagine it is deposited on different day. That means you got the check, kept it in the drawer, forgot about it, deposited after 1 week. Now, when check is received, cash account debited to party account. You can't put it to bank. You will record it as cash. Is it actually cash? No. It is there with you. That's all. When you deposit, what you are going to do? Bank account debited to cash account. Sometimes in question, they will only mention that all checks are treated as cash receipts. When they tell all checks are treated as cash receipt, that is, now tell me one thing. In the question, no, they are told all checks are treated as cash receipt. Now I am going to tell you a transaction. Check received from X. What is the entry? Cash account debited to X account. Is that correct? Is that right? Now I am going to tell you check given to Y. Y account debited to bank account. Ta-dang. Y account debited to bank account. Only the checks which you receive, you are treating it as cash receipt. Check when you only write and give, you are going to treat it as bank only. It has to be routed through bank only. So understand this. Question mentions that treat all checks received. Not all checks given. All checks received as cash receipts. Then ignore dates and pass entries as if check is deposited on different date only. Clear? That's it. Cash book format and all you should know. What is contra entry, guys? Debit also is in the cash book. Credit also is in the cash book. So that time what you will do? That LF column which was feeling alone from a very long time, you will go and write one C over there. Clear? You will go and write one C over there. That's it. Now, example, cash deposit and all, you know what is the entry? Petty cash book. What is petty cash book? Just a quick discussion. Cash book where petty expenses are recorded. Petty expenses. Imagine I tell petty cash book for 500 limit. Everything below 500 petty cash book. Anything more than 500, it will go to cash book. Okay. Amount received less than 500, cash book. Petty cash is only for payments. Receipt, any 1 rupee receipt also, it will go to cash book only. Cashier only will collect it. Only for payments I have given him the job, less than 500. Is it clear? Okay. Now, there they told normal and impressed. What is normal? Normal means amount given to petty cashier, let's assume 5,000. And he spent 3,000. How much should be remaining? 2,000. Next period, whatever it is, next week, next month, whatever it is. Again, they'll give 5,000 only. That means ignoring how much he has spent, they'll still give the same amount. Clear? Impressed method. 5,000, 2,000 spent, 3,000 is there. Again, they'll give 2,000 only to make the balance 5,000. That means same balance is continued in impressed method. Okay, that should be it. Format and all you should be able to know. Journals, How to rectify, we'll discuss that. Just wanted to, this one. Sale of goods on approval or return basis. Did we have a chapter called as sale of goods on approval or return basis in old scheme of CA foundation? Yes. Now they removed it. Yes. In rectification and inventory chapter, still they have those questions. Are you getting my point? I say, no. Lazy just like you guys. Okay. Just like you guys. You guys only later on will be part of ICA, right? So you know how lazy you are. Okay. What ICA will do? Okay, this chapter is not there. But wherever that chapter related questions are there in other chapter, they don't go to search. Same thing they will keep in the study material. Now, sale of goods on approval return basis means what? What does it mean? I am selling to somebody and telling, if you like it, keep it. If you don't like it, give it back. Clear? Now, what is the impact of this? I'll tell you. ROE, rectification of errors. And then, apart from rectification of errors, the other impact that this is going to have is very important on inventory chapter. Inventory chapter, sale of goods on approval return basis can play a huge role. Can it be asked in final accounts? Yes. Can it be asked in partnership? Yes. Can it be asked in incomplete records? Yes. Okay. Have they asked till now? Not often, but they can ask. Okay. Now imagine if I send goods. One person send goods to Wasim. And they tell, who is who now? I only lost track of the people in this example. M&M. Okay. I get this now. Now, M&M is making crazy business. Okay. So what this one person called Hema Shri, what she did was, she decided that she will prepare her own Indian M&M, Indian gems. And she gave the 10 boxes of chocolates to Wasim. Wasim told, get lost. Okay. Why should I even keep this stupid chocolate? Already M&M is doing well. And already Cadbury Gems is there. So now, in that case, that means when someone new is trying to enter into market, it's very hard for them to get into market, right? So what they will do when they are new and they are trying to get into market, they will ensure that they will tell, keep it and give 3 months time. If at all it goes good, you have to give me money. If it doesn't go good, don't worry, I'll take everything back. This is called as sale of goods on approval or return basis. Clear? Now, imagine time is there till 1st of May. Sale is made on 1st of February. Say whenever you see sale of goods on approval or return basis, right? As soon as you sell, you'll pass the entry. That means what? You are having positive mindset. Your goods, right? You are thinking that it will be accepted only. You'll pass the entry. Okay, whoever the person is to sales. Is it clear? You'll pass the entry. Sale entry will be passed. If it is rejected, what will you do? Reverse the entry. Reverse the entry. It's not sales return. Just reverse the sale entry itself because sale only was passed with doubt, little doubt. So reverse the sale entry. If it is accepted, what to do? No entry because already you passed the sale entry. Before accepting only you pass the sale entry. Now the problem is in rectification or in in inventory chapter, the problem is sale is made and before the sale date and the accepting date, the time given, year end will come. Sale is made on what? 1st February. Till when that person has time? 1st May. Before 1st February and 1st May, there is 31st of March. Now, 31st of March, what you have to do? You have to, if it is not yet accepted or not yet rejected, not accepted also, not rejected also, there is more time. Is there more time? When there is more time, always reverse the sale entry. Why, sir? He can accept, right? Even if he accepts, right, he will accept when? In the next period only. If he accepts also, when will he accept? In the next year only. If they accept in the next year, it should be sale of next year only. So reverse the sale entry without even them telling anything. If sale is reversed, goods are there with you only then. Sir, no, goods are sitting in his shop. Yes, goods are sitting in his shop, but who is the owner of that goods? You only. So if sale is reversed, you have to take that as closing stock on approval account debited to trading account. But closing stock will not be at 1000, it will be at 800 because closing stock will always be at cost or NRV, whichever is less. Is this clear? Are you following this? Okay. Capital versus revenue, you already know. Okay, what is capital? What is revenue? Any expenditure, any income can be considered as capital, can be considered as revenue. If it gives you benefit for more than 1 year, it is always capital. Okay, along with one capital expenditure, we got many things. That is also capital. Clear? For example, I had one beautiful building. Okay, I had one beautiful building. No paint at all. Still beautiful. Clear? Now I decided that I'll paint it red. I'll paint it fully red. Is it capital expenditure or revenue expenditure? Capital expenditure or revenue expenditure? It is revenue expenditure. Good morning. It is revenue expenditure. What did I tell? I already had a building. I already had a building. It was a beautiful building. Now if I'm painting it, it's just for maintenance purpose. Are you getting this? Full capital expenditure, revenue expenditure, I'll explain just with an example. Okay, it can fetch you 2 marks in the exam because they can ask for true or false. Now understand this. I had a building. What did I tell? I had a building. Clear? Building already had a paint. After some time, I changed my mind. I became full RCB fan. So I painted it red. Huh? Go now. I painted it red. What is it? No. What is it? Capital expenditure or revenue expenditure? Revenue expenditure. Because you already had the building. Is this clear? Now, after some time, I changed my team. Okay. I painted it blue. Mumbai Indians. Correct? Mumbai Indians. I saw that all Indian players are playing in Mumbai Indians only. Let me support that team. Okay. I painted it blue. Is it capital expenditure, revenue expenditure? Revenue expenditure. You are just doing this for maintenance purpose. Clear? When you did this, you decided that. Because I painted it blue, lot of people are coming. Mumbai fans, too many were there. Okay. So, I extended the building. Capital expenditure or revenue expenditure? Capital expenditure. When I was extending this building, okay, before I was extending this building, nearby land was there. That nearby land belonged to somebody else. Okay. I chased him away and I purchased that land. Is it capital expenditure or revenue expenditure? Capital expenditure. But when I purchased that land, the land was like this. The land was like this. So I brought one bulldozer and I made the land level. Is it capital expenditure or revenue expenditure? Capital expenditure. After that, I broke this wall. Capital expenditure or revenue expenditure? Capital expenditure. Then I constructed extra space. Capital expenditure or revenue expenditure? Capital expenditure. When I'm constructing this extra space, I need workers. So I constructed one temporary hut for them. Capital expenditure or revenue expenditure? Capital expenditure. They did their work very well. Then I told, get lost. Okay, and demolish this hut. Capital expenditure or revenue expenditure? Capital expenditure. Clear? After everything happened, after 2 years, okay, after 2 years, there was a problem. There was a major problem. On a rainy day, there was one lightning that struck my building and my wall broke. Why? My wall broke. So I'm constructing the wall again. Capital expenditure or revenue expenditure? Revenue expenditure. Good morning. Revenue expenditure. Why? Because already it is giving you some benefit. It is not giving you extra benefit now. Understand this. First time you are buying something, an asset which is going to give you benefit for future. That means you are starting from zero. Correct? When you already have that asset, it got damaged. You are repairing it. When you repair it, that time what happens? You are going to get the same benefit what you are getting before. Now if I tell you car was going, car stopped. How much mileage will give if a car stopped? 0. Now you repaired the car. It will give you again mileage. Is it capital expenditure or revenue expenditure? Revenue expenditure. By repairing, you are getting the same thing what you are getting before. Clear? Now when this lightning struck, you told God is sending you message. Okay, God only sent message. So you decided when the lightning struck and this wall fell down, you chased a few more people in that area and you purchased more land. You saw the wall falling down as an opportunity and you purchased more land and you made a bigger building. Capital expenditure or revenue expenditure? Capital expenditure. Is it clear? Are you clear with this? Now, ultimate. This building, you made it right next to the Mumbai Indian Stadium. Mumbai Indian Stadium. And before that, this building was red in color. Now, suddenly you are going to paint the entire building blue in color. Entire building blue in color. Because you painted blue in color, you will get more customers. Capital expenditure or revenue expenditure? Capital expenditure. Capital expenditure. I see I can throw such bamboos also. Are you getting my point? So if it gives you extra benefit, it is always capital expenditure. Why we chose Mumbai Indians? We don't want RCB CSK fight in marathon. Okay. Is that clear? We don't want RCB CSK fight in marathon. That's why we chose Mumbai Indians. Already we won the cup this time, so we are not going to worry about any other fights. Disclaimer it was. Okay. So we'll support Mumbai Indians. Rohit Sharma is also our player only. Bumrah also our player only. Hardik Pandya also our player only. Surya Kumar Yadav also our player only. Ishan Kishan are there. Okay. Full Indian team is sitting in Mumbai Indians only. That's why they are called Mumbai Indians. Okay. Is it clear, guys? This is capital and revenue. You should understand that. Now, if it is recurring in nature, it is capital or revenue. If it is recurring in nature, it is revenue. Non-recurring, capital. Purpose of expense to give you long-term benefit, capital. Short-term benefit, revenue. Clear? Repairs to an asset. Extra benefit, capital. No extra benefit, revenue. That should be it. I asked this example. CA office, there is books. There are books. What is it? Capital or revenue? Capital. You will buy Companies Act once and use it for 15 years. Correct? Capital. But you will buy one magazine. That is revenue. Is it clear? Yes, that should be it. What and all has happened? Oh. Too cold. Change the angle. Stand, man. Stand. Push it fully up or fully down. Is it hitting you now? Fully down you make it. No need. Is it hitting you directly? Done. Solved. Problem solved. Okay, someone is asking if not mentioned to treat as cash receipts, then also are we going to do the same? No, sir. Yes. Sir, in the question to treat cash is okay, same thing. Capital. Now someone is telling within the building, okay, they are going to have storage places. New storage places created. Is it going to give you extra benefit in future? Yes, capital expenditure. Within the building, I break the wall little and I create a nice wardrobe. Capital expenditure. Is it clear? Yes, that's it, guys. Now, let's continue. I think, what happened, man? Onward, it is always on only. What is this? Where are you from? Then you should be adjusted to the cold, right? Now, because you asked this topic, okay, we'll discuss it. Debit note. Okay, guys. Shh. Debit note, credit note. Okay, debit note, credit note. Tell me one thing. You have, okay, I just wrote it random sites. It doesn't mean that this side whatever we are writing is debit note. Now, I sent the goods. Goods went. Correct? For me, what is it? Sales. For the other guy, what is it? Purchase. What a beautiful building. Okay, for other guy, what is it? Purchase. Correct? One guy it is sales, other guy it is purchase. Clear? Now, when I have written the sale, what did I do to the other party? Did I debit the party? When I have recorded purchase, did I credit the party? Yes, correct. Now, this fellow, whoever purchased the goods, he did not like it. Okay, goods were very bad. What did he do? He put the goods back onto a truck. Okay, he put the goods back onto a truck and he sent it. When he's sending the goods, when I'm selling the goods to somebody, when I'm selling the goods, I will give them bill, which is called as invoice. Correct? When I'm returning the goods, they have to give some document, right? Now, when they are returning the goods, what they had done to us before in their books? They had credited the party. When they are returning the goods, what they will do? Debit the party. That means whenever you are returning the goods, when purchase returns happens, purchase returns are debited or purchase returns are credited. Purchase returns are credited, but the respective person is debited. So you prepare a debit note along with the goods, you prepare one debit note and you put the debit note also on the truck and you tell them, take this debit note. Okay, that means in the debit note I am telling, oh party, I am debiting you. Are you getting my point? Oh party, I am debiting you in my books. Why I am debiting? Because these goods are bad. Are you getting my point? This is debit note. So when I debit it, along with the goods, I will send one debit note telling that goods are bad. Reason I will tell, and I will tell that these goods are going to be returned to you. And because it is going to be returned to you, I am going to give this debit note. In that debit note, I am telling your account now with us is debited. That means anymore I don't have to pay you. Now this truck will reach over here. It will reach over here. The person will receive the goods and remove the goods and see the debit note. Then he will compare with the goods and see, okay, everything is correct. Actually what he told is damaged is actually damaged. Then this fellow will send a document to him telling credit note, oh party, I received the goods. What you told is correct. So because I had debited in my books, I will credit you now. So this fellow will prepare credit note. Simple. If at all, anytime you get confused in the exam, right? Debit note, credit note sites. Just remember, if you had debited the party, when will you debit the party? When you sell the goods. Correct? That time, if at all something happens, returns happen, you will give credit note. Whenever you debit the party, when will you debit the party? When you purchase the goods. Correct? Sorry. When will you credit the party? When you purchase the goods, you will credit the party. So when you give it back, you will debit. That means debit note. Clear? This is your concept of debit note and credit note. Now, you have written in your material, right? The questions to be discussed. Question number 8 and question number 9. So first question that we are going to discuss is journal question number 1. Okay. First question from our marathon discussion is journal GST question SM8 and journal GST question SM9. Is this clear? Are you following this? Question 8. You guys are feeling hot. I'm actually feeling hot. Sir, someone is asking, sir, what is the duration of this class? What do I tell? Only few hours, guys. Only few hours. It's 9 o'clock. Let's hope that next night, whenever we see the clock tick 9, we are not seeing each other's face. Let's hope. Now it's 9 o'clock, right? Whenever we see the clock tick 9 again, let's hope that we are not here. Okay? Let's hope. Hope is a good thing in life. Hope is not there. Sakyat is also not there. Okay, guys, listen. First, journalize the following transactions in the books of Mr. Rohit. See Mumbai Indians. I told you Mumbai Indians. Okay. Purchase goods from Sahil. Okay, for 50,000 plus CGST and SGST. Whenever you are purchasing goods, what is it? It is input GST. Input GST is asset or liability? Asset. Output GST is asset or liability? Liability. Whenever you are collecting from the party and you are supposed to pay to Nirmala aunty, it is liability. But input GST is what? It will help you adjust that. That means it is going to give you benefit of adjustment. That is going to be asset. Is it clear? Now, purchase goods from Sahil for 50,000. So, can I take the entry as purchase account debit for 50,000 only? But input GST, you have to add. Correct? And then you will write to Sahil's account 59,000. Why Sahil's account 59,000? Because what you are supposed to pay to Sahil is 59,000. Including GST, you are supposed to pay to Sahil is 59,000. Clear? Next. Purchase goods from Sam for 40,000 at a trade discount of 10%. That means first only remove the trade discount. Correct? When you remove the trade discount, 40 becomes 36,000. Then you talk about everything else. Plus CGST and SGST 9% each. 20,000 was paid immediately. 20,000 was paid immediately. Whatever you are supposed to pay, 20,000 paid immediately. That means balance payable after 3 months. That means in one entry only you have credit also, you have cash also. So now understand this. Purchase account debited 36,000. I told you 36,000. Add the GST. Now do you agree this is what you are supposed to pay?
Yes.
This is what you are supposed to pay. Out of this, 20,000 is paid. That means balance is the one credit. This is the balancing figure. Is it clear? 36,000, if you total 36,000 plus 3240 plus 3240, okay, you will get 42,480. Out of 42,480, 20,000 you are going to pay now and 22,480 you are going to pay in future. Is this clear? Next, third one, goods costing 20,000 withdrawn for personal use. Withdrawn for personal use. Such goods were purchased by paying CGST and SGST of 9% each. Now tell me one thing. Do you understand this? That if at all goods are withdrawn for personal use, that means you only become the consumer. When you become the consumer, whatever you told, input and all, everything has to reverse. So goods were costing how much? 20,000. So that means you had purchased the goods. That time GST and all was recorded. Now when it is used by you, all the GSTs, input GSTs have to be reversed. So you will write drawings account debited, not 20,000, 20,000 plus the GST. Because you are the consumer, you have to bear the GST also. Before GST was on my head, now you are the consumer, I'll put it on your head. Clear? So 20,000 plus GST. Two purchases. Purchase will get reversed for 20,000 only. And the GST should get reversed. Input GST, input GST. Input CGST, input SGST. Can you see the GST getting reversed? Now, when it was purchased, can you see GST was created here? When it is reversed, can you see GST getting reversed over here? Clear? Yes. Now next, rent paid to Gagandeep for 30,000 plus CGST and SGST 6% each. Sir, rent and all we don't have to bother, sir. It's only for goods. No, it's GST, goods and service tax. Even if you are providing service, even if you are receiving service, GST will be applicable. Paid rent, how much? 30,000. Rent, what is the entry usually? Rent account debited to bank or cash account, whatever it is. Okay, so now here you are going to write rent account debited 30,000. To bank, but when you are paying, you will pay even the two GSTs, input CGST, input SGST. Are you following this? So whenever it is outflow of goods, okay, or services, that means it is outward or output GST. Whenever it is inflow of goods or services, that means you are receiving goods, you are receiving services, it is input GST. Clear? Next, goods costing 5,000 before trade discount 10% return to SAM. Goods costing 5,000 before trade discount. That means how much is it? Only 4,500 now. Okay, return to SAM. Such goods were purchased by paying CGST and SGST. Returned up. So GST also reversed up. I don't have to pay government any GST now. So now what will happen? Okay, SAM's account debited. Usually the entry for purchase return is SAM to purchase return. Now you'll write SAM to purchase return. Okay, 4,500 that we have already discussed. On 4,500, whatever GSTs are there, that also will get reversed. Is it clear? Are you following this? Now, next, purchase furniture. Sir, asset purchase, sir. I don't have to pay GST. Anything. GST will be applicable. Clear? Purchase furniture for 44,800, including IGST of 12%. ICA is bamboo. What is the ICA bamboo here? If you add 12% and sit to no, you will get wrong answer. It is including IGST. Can you see they built a pattern? It is like a bowler in the test match. You know, bowler in test match, he'll bowl one outswing, he'll bowl one outswing, he'll bowl one outswing. Batsman thinks that ball is going out only. The next in swing, bowled. Are you getting my point? Same way, 1, 2, 3, 4, 5 questions. They kept telling where you have to add GST, where you have to add GST, where you have to add GST. Suddenly one including what they threw in between. Purchase furniture for 44,800, including IGST. That means in this 44,800, GST is there. If GST is added 12%, that means it is not 100 rupees, it is 112 now. So you take this as 112. That means how much is 100? When you do cross multiplication, you will get 40,000. That means your furniture value was only 40,000. IGST was 4,800. See the entry now. Furniture account debited, IGST account debited to bank account. Is this clear? Are you getting it? So the word that you have to spot for is including. If at all they give including, then you have to be careful over there. Clear? Next. Purchase machinery from Symphony Industries for 1,40,000 plus CGST and SGST plus. That means you have to add. Clear? Each. Paid 1 lakh immediately and balance to be paid after 2 months. Did we have a similar transaction? Yes. So 1 lakh we know is cash. Remaining everything will be credited to Symphony Industries. So now here you are going to write machinery account debited. Input CGST, input IGST. Can I take this as 1 lakh 52, 1 lakh 64, 1 lakh 65,200? This is the amount I am supposed to pay. Out of that 1 lakh is paid. That means 65,200 will be paid later. So this is a combo of cash and credit. Is this clear? This is a question that you have to remember. Yes guys, let's continue. Done. That was 8. I made you write in your final revision that GST question number, journal question number 8 you have to do and journal question number 9 you have to do. Clear? This is the question number 9. Why question number 9 we have to do? Why question number 9 we have to do? Because same thing but on the other side. That is sales. Okay. One side we saw purchase, other side is what? Sales. Now, journalize the following transactions in the books of Nidhi traders. Okay. Let's go to question number 9. Sold goods for 50,000, charged CGST and SGST at 6% each. Sold goods for how much? 50,000. Tell me normal sale entry. Normal sale entry. Sold goods for 50,000, maybe it is for cash, right? Cash or debtors account debited to sales. What will get added? That cash and debtor balance will increase. And along with sale, you will have to write to output CGST, output SGST or output IGST. Is this clear? Okay. Now, sold goods, bank account debited to sales. But the amount will not be only 50,000. The 2 GSTs also got added. Clear? You are seeing from the other side of this stage now. That time you are seeing from this side of the stage where we are going to be purchasing. Now we are going to be selling. Now, sold goods to Surjit for 28,000. Including, can we see this word including CGST and SGST, ICAs, Bamboo again. Okay, 6% each. Clear? Now, 28,000 is including, correct? How much is the GST? 6 and 6. So this makes it 112. How much is 100? 25,000. So can we understand that the sale is only 25,000? Okay, sold goods to Surjit. That means it is a credit sale. So you will write Surjit's account debited to sales 25,000 and remaining amount is GST. Is this clear? Spot the word including whenever GST transactions are there. Next, received 25,000 from Surjit in full settlement of his account of 28,000. Just now we sold, no? How much we were supposed to receive money from Surjit? 28,000. How much we received? 25,200. Okay, obviously discounts are going to be there here. Bank account debited 25,200. That is obvious. Surjit account credited how much? 28,000. Discount allowed is 2,800. Clear? Nothing to do with GST. It's just amount received. If goods only were received, that means it is sales return. That time GST also returned. Next. Sold goods to Kapil for 30,000. Charged IGST 12%. Received 12,000 immediately and balance to be received after 1 month. Did they do the same thing what they were doing in purchase on the other side now? Okay, now understand this. Bank account debited, Kapil's account debited. First of all, you tell me how much is the value here? 30,000, correct? 30,000. How much is IGST? Can I tell 30,000 plus IGST of 12%? That makes it 33,600. Is it 33,600? Sale is 30 only. Output GST is 3,600. Out of that, how much is received? 12. Balance, everything is receivable. So debtor is debited. Is it clear? Are you following this? Next, Kapil was allowed rebate. What is rebate?
Discount.
It is kind of discount. Rebate is usually given when the goods can't be returned only. Even imagine goods are in semi-damaged state. Now you can return until you see it is spoiled. Okay, you got Zomato delivery. Little spillage has happened. Okay, the sambar has fallen into your ice cream. Okay, now what to do? You will click picture and send, right? You will click picture and send. Now on the way, ice cream has evaporated. Can you click picture and send? No, there is no ice cream only. So you will tell, I cannot return the goods. Or imagine sambar has spilled over, you will return the goods. There is no ice cream only. Someone on the way has eaten it. So now what will you do? Can you actually return anything? No, right? But still, will you get a cashback? Will you get a cashback? Will you tell it's not there? Correct? Don't do it on purpose, huh? Okay, don't. Zomato will still give money, okay? They are big fools. Okay, you only after that put the sambar like this on the ice cream, click picture and put it up. No, within 1 minute, they'll still give you cashback. Okay, but don't do it. Okay, Kapil was allowed rebate of 5,000 as goods supplied to him were defective. Clear? These goods were sold by charging IGST of 12%. Now, if it is defective, okay, when he's allowed rebate of 5,000, what should happen? Even the GST should reverse. Sales return, rebate, GST also should reverse. Now see over here. Rebate account debited. Why rebate is debited first of all? Sorry, expense. Yes, it's like a discount. Rebate account debited 5,000. Output GST was credited that time. Now output GST is going to reverse. So output GST debited to Kapil 5,600. Is it clear? Next. Sold goods to Manpreet for 1 lakh at trade discount 20%. Okay, you may immediately remove that. Now it became 80,000 and charge IGST. So all your transactions will start from 80,000 only. So can you see over here, Manpreet's account debited 89,600 to sales 80 and output GST is 9,600. Is this clear? Next, goods of list price. This is what I was telling you. Goods of list price returned by Manpreet. Goods of list price returned by Manpreet. Did you sell goods to Manpreet at list price? No, you sold goods to Manpreet after discount only. So this is going to be 20,000 minus 20%. 16,000 is the value that is returned to you. 16,000 is the value that is returned to you. Is it clear? Are you following this? Now 16,000 when it is returned, pass the return for 16,000 only. Can you see sales return 16,000? GST also remove. So output GST and 17,920. This 1,920 was calculated on 16,000 itself. Are you following this? Yes. Now, some areas we might be going fast. It's marathon, guys. So later on, if anyone is, if at all you're watching this video, you just pause, do the calculation. Oh, got the answer? Okay, go forward. Clear? You don't have to go at the same page if you're watching it like previous day of the exam at 1.5x or something when you're watching, right? You just have to pause it, do the calculation. You got the answer over, done. Don't write anything. When you're doing marathon or previous day of the exam, don't sit and solve everything. Just have the happiness that you're getting the answer and go forward. Are you getting this? Yes, last, received commission. Commission received means we have provided some service. Charge CGST and SGST. So here also, you are going to pass the same situation. Cash account debited. Commission, output GST, output GST. Is this clear? Done. We are not discussing anything more in journal. Done with journal, guys. That's it. Now actually our syllabus starts after 1 hour 37 minutes. Actually syllabus starts here. But whatever we discussed, it will actually be important for the discussion what we are going to have further. Now, go and write next. Rectification. Rectification of errors. So till rectification of errors, if you just revise all the concepts, that's more than enough. Okay, rectification of errors. First thing you're going to see is the concept. First thing that you're going to see is the concept. After the concept, there are plenty of questions, right? Plenty of questions are there. See the master question. Enough. I'll show you one master question. Almost all errors are there over there. Don't have to worry about anything after that. Clear? Now, rectification of errors. Let's go into this is your halat, no? In rectification. This is how you sit. Oh, so many errors. Okay, now rectification of errors. Let's quickly discuss the concept and then we'll go and solve that master question, which is that types of errors. What are the types of errors? What are the types of errors, guys? What is the marks, by the way? 10 marks. Rectification can be asked for 10 marks. Okay, sometimes they ask for 5 marks, but usually somewhere or the other rectification is there in the paper. Clear? Now, and it's easy 10 marks. I'm telling you, it's easy 10 marks. Error of principle. That means what? You're science student. Okay. Error of principle means what? Okay, you're sitting and you're passing journal entry, you're science student. Your concept only is wrong. You don't know what is debit, what is credit itself. But still you did debit and credit. So I paid salary to somebody, I passed the entry, cash account debited to salary account. I passed the entry, cash account debited to salary account. Clear? Okay. Or I purchased a calculator. Okay, I treated it as building. Possible? Or I purchased one newspaper. Instead of treating it as expense, I treated it as library book, asset. Possible? Clear? So usually error of principle is capital item treated as revenue item. Okay, that means your accounting principle has gone wrong. Will the trial balance tally? Yes. Why? Instead of debiting something, you have debited something. Still your trial balance should tally, no? Now imagine I have purchased goods from Praveen. What entry I should pass? I should pass the entry purchase account debited to Praveen. Correct? Purchase account debited to Praveen. Instead of this, I pass the entry diamond account debited to Praveen. Clear? I have purchased goods. I have written diamond account debited to Praveen. Will it still tally? But is there an error? Yes, error of principle. Okay. Other than that, we have clerical errors. Actually, if I ask you, how many types of errors are there, you will tell 4 and all. But actually, there are only 2 types of errors. One, error of principle. Second one is clerical errors. In clerical errors, you have different types of errors. First one is error of omission. Then error of commission. Then compensating errors. Is this clear? Compensating errors. Now, error of omission means what? You missed the process itself. You are supposed to do something, you missed the process itself. That is called as complete omission. Complete omission, trial balance will still tally. Imagine I gave you work of passing 10 journal entries. You have not written all 10. Will your trial balance tally? Yes, debit will be 0, credit will be 0. Are you getting this? All 10. If you have missed 2, will your trial balance tally? Yes. But in that 2, you missed one debit. Will your trial balance tally? Is it omission? Yes, it is partial omission. Trial balance will not tally. Partial omission, trial balance will not tally. Is it clear? Now, error of commission. Error of commission. What does it mean? You have done the work, but you missed something. Okay, or you have done something wrong. Debit was 80, you made it 8,000. Debit was 80, you made it 8,000. Debit, credit were recorded. When you transfer to the ledger, you put instead of debit side, you put it into the credit side. Possible? Okay, wrong posting or wrong amounts only. All these are called as error of commission. What is compensating error? What is compensating error? You didn't do the homework, teacher only is absent. Are you getting my point? You didn't do the homework, teacher only is absent that day. Compensated with each other. One error, trial balance will still tally. Is it clear? Now, error of commission. Let's go into error of commission. Error of commission when I am discussing writing wrong amount in journal, both debit and credit. Is it error of commission? Yes. Will trial balance tally? Yes. You made both sides error, right? Now, entering wrong amount in subsidiary book. I told you subsidiary book is going to play a crucial role. If this is my subsidiary book, I told you if you enter the wrong amount, to the party also it will go wrong. Total also it will come wrong. So both the sides it will be wrong. Clear? Entering wrong amount, trial balance will still tally. Correct entry posted to wrong account. Received money from Ram and I have put it to Raman's account. Will you still get the trial balance to tally? Are you getting my point? Yes. Okay. Now, trial balance will not tally when posting wrong amount in ledger. You passed the entry correctly. One side you posted wrong amount. Instead of 80, you put it as 8. Will it tally that time? No. Posting amount on the wrong side of the ledger. Instead of debit, you put on the credit side. Will it tally that time? No. But if one you put on credit, the other one also you put on the wrong side, then will it tally? Yes. Wrong balancing of ledger. You had one ledger, 100, 20. You had to write 80. Correct? You wrote 80. and you wrote buy balance brought down 80. Is it correct? It should have been on the other side. Clear? This is the error that is happening over here. Wrong total in subsidiary book. Wrong total in subsidiary book. Everything done correctly. Sir, wrong total. Why trial balance will not tally? That means what? You have entered correctly. You have entered correctly. But when you are totaling, your calculator did not give you hold your hand. So now what happens? Wrong total. Wrong total will affect only one side. Entered correctly. This will go correctly. Are you getting my point? Subsidiary book, understand this. Two people will take two different routes. From here you will put the amount over here and this will come to total. This fellow will go in this direction. This fellow will go in this direction. Clear? If at all you enter correct amount came correct down also, both the people will go correctly. If you enter wrong, both the people will go in wrong with wrong amounts. If you enter correct but you did totaling mistake, one person will go in correct direction, other person will go in wrong direction. Is this clear? Are you following this? Yes. Now, let's go further. Stage of rectification. What is the stage of rectification? 3. Before preparation of trial balance, after preparation of trial balance, in the next accounting year. Clear? Before preparation of trial balance means what? Before you prepare trial balance, that time only you got to know the error. Something happened and you identified the error. If trial balance is not prepared, is there suspense account? Suspense account will be born when trial balance is prepared. Correct? So there is no suspense account. Therefore, when before preparation of trial balance, suspense account not to be used because suspense account was not there only. Rectify one-sided errors by passing a statement. You will just write a statement and correct one-sided errors. Two-sided errors you will pass journal entry. Is this clear? Now, what if trial balance was prepared? What if trial balance was prepared? If trial balance was prepared, do you agree? One-sided mistakes would have created suspense account, but two-sided mistakes would not have created suspense account. Imagine, I have to write 100 and 100. Both the places I wrote 80 and 80. Is it a two-sided mistake? Will it create suspense account? No. But when I am writing, if I write 100 and 80, is it a one-sided mistake? Will it create suspense account? Yes. When I rectify it, should I remove the suspense account? Yes. So whenever there is rectification after preparation of trial balance in the same accounting period, suspense account to be used. Suspense account simple. Think of the rectification entry. Think of the rectification entry and then whenever you have in your rectification entry debit but there is no credit, credit will be suspense account. In your rectification entry, credit is there, debit is not there. Debit will be suspense account. Is this clear? Now, when one-sided errors are rectified, suspense account to be used. When two-sided errors are rectified, suspense account not required. Clear? When one-sided errors are rectified, if in the rectification entry an account has to be debited, then suspense account to be credited and vice versa. Clear? These are things you have to remember. In the rectification entry, if you have to debit one account but you don't know or there is nothing to be credited, then credit will be to suspense and same thing you are going to do vice versa. Rectification after preparation of trial balance in the next accounting period. What does it mean? This year, everywhere you searched, you didn't get the error. You moved on with life. Okay? Next year what happened? You found the error. Clear? You found the error. This year when you are moving on, are you moving on with suspense? Yes. That means next year when you find out, suspense should go. That means next year when you are rectifying, if it is one-sided error, suspense should go away. But some things are there, which if it happens in this year only, the beauty is there. Expense and income. Expense and income should have impacted your this year's profit. It went to next year. Now, if you put it next year, it will impact your next year's profit, which should not happen. So, when you are rectifying in the next year, if there is any expense or income, remember this. Instead of expense or income, you will put P&L adjustment. Is it clear? Reason being, this year's expense, this year's income should not impact next year's profit. But in your rectification entry next year, you have asset or liability. It is not going to bother you. It's a balance sheet item. So that you will use the respective names itself. Is it clear? So rectification entry will be passed same as previous case. In the rectification entry, if there are incomes or expenses, use P&L adjustment account. Is this clear? Now, listen. P&L adjustment and suspense. They have no connection. They have no connection. Suspense comes when there is one-sided error. That time other side will be filled with suspense in the rectification entry. P&L adjustment comes when you see income or expense. Instead of that, replace them and put P&L adjustment. Is this clear? Now, one-sided error, trial balance will not tally. Difference would have gone to suspense account. Therefore, use suspense account in rectification entry. Two-sided errors, trial balance will tally. Suspense account not needed even when you rectify. Clear? Method to rectify. How to rectify now? Pass correct entry, pass wrong entry, then pass the rectification entry. Is this clear? Are you following this? Now in exam, what are they giving marks for? Rectification entry. How are you going to present the rectification entry in the exam? Journal entries in the books of, and you're going to write one after the other rectification entry only. Where if you want to write correct entry, wrong entry, where you should write it? In your working notes. If you have developed the skill of rectification, right? You can do correct entry, wrong entry in your head itself. Directly you can write rectification entry. Is it clear? Now, important notes. Important notes. If account is not debited, what should you do? Debit it. If account is debited less, debit it. If account is not credited, credit it. If account is credited little less, credit it. If account is wrongly debited, then you have to do ulta, credit it. Clear? For example, I wanted 100 on the debit side. Instead of that, what did I do? I have put 100 on the credit side. Now to bring 100 on the debit side, what should I do? If I put 100 on the debit side once, it became 0. If I put once more, now I have 100 balance. Is this clear? So whenever something wrong has happened on the other side, first put it on the correct side to reverse the error, then put it on the correct side to give the effect. So if wrongly credited, debited. Clear? These are the things that you need to know. That's it with rectification of errors, actually the concept. But I have to add one more thing, okay, which usually people get confused. If asset is not recorded. If asset is not recorded, okay, we have to record asset actually, but error is asset is not recorded. That means even depreciation is not recorded. If asset only is not recorded, depreciation is also not recorded. Therefore, when you rectify, record the asset. Therefore, record even the depreciation. Clear? Now, if asset is recorded instead of expense, it was actually expense. They took it as asset. If the asset is recorded by mistake, then depreciation is also recorded. Therefore, remove the asset and therefore remove even the depreciation. Is it clear? This is one thing which can regularly trouble us. This you need to know. Any doubts with this till here? Now, next, we'll go into rectification of errors, master problem. Rectification of errors, master problem. There is one golden rule which we didn't discuss. Okay, one golden rule is there, not golden rule of accounting, golden rule of rectification. What is not told to you is correct. What is not told to you is correct. You know why? Because rectification of error question starts only by them telling, following are the errors, please rectify it. Following are the errors, please rectify it. So the errors when you are rectifying, why do you need to bother about correct things? So what is not told to you is correct only. What they are telling you is only errors. Is this clear, guys? Okay. Now there is rectification of errors. One small problem is there. Okay, small problem. Few. Only 31 errors. Okay, that's it. Once we finish this 31 errors, right, straight away we are going to BRS. BRS also has one small problem. Few. Only BRS and rectification, there are master problems because others have different concepts. You can't create everything into one. Okay, now get ready, guys. This one you have to solve. Okay, this one you will have to solve. How will you solve this? Take your notes, open your book, and make it into 3 columns. Are you in a position to solve without correct entry, wrong entry? No. What is this? We can actually, right? So make your book into multiple columns, correct entry, wrong entry. Okay, then listen. Correct entry, wrong entry, and then you're going to have 3 more columns. That is before trial balance, after trial balance, and next accounting year. Clear? These are the columns. Now you have to do the fill in the blanks. Okay, you have to do fill in the blanks for these 5 columns. Are you ready? 1 minute. What you're going to do, Maggie, is it? Half Maggie you can do in 1 minute. In the ad, not in reality. Yes, guys. Now we are trying to, what do you say, safeguard 10 marks by doing this. Trying to ensure that 10 marks are into the pocket. Okay. Rectification is important. You know how important rectification is? Now many of you are thinking 10 marks rectification will come. I told you, you don't pay marks for setting paper. Okay, so you will think that you don't pay money for setting paper. Or you are not paid money for setting the paper. Now some of you think 10 marks. Can I do it without this 10 marks? Now see the bamboo. Okay, see the bamboo. Final account question, rectification. Errors. Clear? Gone there 15. Okay, 25. Then partnership question, rectification. Okay, let's say half. Both don't have rectification. 10. So 15 plus 10, 25 plus 10, 35. Gone. Incomplete records came for 10 marks. Incomplete records, what you will talk about rectification? That full question only is rectification. Nothing is right over there. So there again gone. Are you getting this? So only company accounts is where they don't test you on rectification. That they will test you at lunchtime. Okay, at lunchtime they will test you. There they will not even tell that there is error. They will give you one question. You only are supposed to identify that there is error. Now you can't tell there, I did not learn rectification. We taught you at foundation. Are you getting my point? That's ICA's logic. I'm like, sir, what about direct entry people? Nothing. They're expected to learn and come. That is ICA's logic. Okay. Now, let's start. Yes, good morning. Let's begin. First one. Purchase returns daybook had been correctly entered and totaled as at 6160, but had not been posted to the ledger. Correctly entered, and also totaled. That means what has not been posted? Where did it not go? Purchase return daybook. So it did not go to purchase return daybook. So can I tell? 1 second, guys. Yeah. Can I tell directly in the rectification entry? Can I tell purchase return should be debited or credited? Credited. So can I write directly to purchase return? How much is the amount? 6160. 6160. That's it. Directly I am writing. Okay. What is it if it is after preparation of trial balance? After preparation of trial balance, I cannot write one-sided, no. Can I write one-sided things after preparation of trial balance? No. What is happening? Double acting. Coolie movie. Okay. Now, what's the debit? Debit will be suspense account debited 6160. Clear? Suspense account debited 6160. Now, what is it if it is in the next accounting period? What is it in the next accounting period? Is it suspense account debited? Suspense account is still debited, but here what will you write? Suspense account debited 6160 to P&L adjustment 6160. Is this clear? Are you following this? Okay. Next, only complicated ones. I'm going to write the correct entry, wrong entry. You can try correct entry, wrong entry on your own. Okay, next. Discount received 1320 had been debited to discount allowed. Discount received has been debited to discount allowed. So you have to remove the discount allowed and you have to put the discount received. Clear? So what should be the rectification entry here? Discount, what should you remove? Discount received. Okay, discount received was debited to discount allowed. So can I write discount allowed account debited? But if I write discount allowed account debited, that means I am doing one more mistake. Discount received, we need 1320 discount received had been debited to discount allowed. That means discount allowed you remove. Discount allowed you remove. And what you have to put? Discount received. Did you get discount received? No. So what you will write? To discount received. How much? 1320. Discount allowed was done what? Debit. To remove debit, what should I do? Credit. So I'll write to discount allowed 1320. What about debit, sir? Oh, both credit only it's becoming. That is it. That is it. But when you go and write the same thing, okay, when you go and write the same thing, that time what will happen? Instead of this, what will get added? Suspense account debited for 2640. 2640. Are you getting this? What should be the entry in the next accounting period? Everything same, but instead of these two, this is same. Instead of these two, I will write P&L adjustment. Clear? I hope you are understanding it. Okay. Whatever is there, this will come this side same, and only thing which will change is P&L adjustment. Third one. Sales account had been under added by 10,000. Under added means what? That means you did not put it. So go and directly write to sales 10,000. To sales 10,000. Correct? What will you do next time? What will you do next time? Suspense account debited 10,000 to sales. When you go to next accounting period, suspense will be same, but sales will be P&L adjustment. Clear? Sales will be P&L adjustment. Are you following this, guys? Okay. Motive is to understand. Okay. Neatness and all, I'm not going to follow. So that's why I'm writing same. So you understand, same entry comes this side. What changes? I'll write the change. Now, fourth one. Credit sale of 1470 had been debited to a customer account as 1740. First of all, are you supposed to debit the customer? Yes, you are supposed to debit the customer only. Now, sale you forget. Sale has happened correctly. What they tell you is only error. So, you have debited the customer, but did you debit the customer correctly? No, you debited the customer what? Less or more? More. Debited for 1470, but you put 1740. 1740 minus 1470, 270. Should you remove that now? So what will I write? To debtor. Okay, customer. To debtor 270. Is this clear? So now when you go to the next accounting stage, what will you write? You will just write, only credit is there. So you will write suspense account debited 270 to debtor. When you go to the next stage, full thing same. Full thing same. Why? There is no expense or income in the rectification entry. Is it clear, guys? Are you following? Yes. Next, we go into the fifth one. Fifth one, a vehicle bought originally for 7,000 4 years ago. Once upon a time story they are telling you. Depreciated to 1,200. We are worried about only that 1,200. Now 7,000, let it go. Okay. Had been sold for 1,500 in the beginning of the year. Why they are telling you timeline and all? Because if they tell beginning of the year, you can one thing be really assured about is no depreciation. Beginning of the year only sold. So you don't have to worry about calculating depreciation till the date of sale. All that is not there. But no entries other than in the bank account had been passed. Money came, it was there. Okay, other things we forgot. So now what should be the entry for this? If you want, I'll give you the correct entry for this because it's a little tricky. So correct entry is bank account debited. Sold for how much? 1,500. What went from your books? Asset, right? Asset account 1,200 to P&L account 300. Profit, right? 1200 asset you're selling at 1500. It is profit. Okay, so now what happens? Wrong entry is what? Bank is correctly recorded, but these two things are not recorded. So what will happen? These two things only are recorded. Sorry, only bank is recorded. Oh, technology. Yeah. Okay, bank account debited. Is this clear? Now, what is the rectification entry now? What is not done, do it. What is not done, this much is not done, right? Do it. That is a rectification entry. Now, if you are in the next stage, what will happen? Same thing will get continued, but what will you add? Suspense account debited 1500. Is this clear? Next stage, what will happen? Suspense will remain same. Asset will remain same. P&L will become P&L adjustment. Are you following this? Is this clear, guys? Someone is telling, sir, will we be able to get the recording of this marathon, sir? I am right now in class. This recording of marathon, no, we will ask Sundar Pichai. We'll ask Sundar Pichai. Wait. Sundar Pichai, no? YouTube. It'll be there, guys. In 3-4 days, it'll be there on YouTube. You can see it over there. Next, 6. An accrual of 560 for telephone charges had been completely omitted. Whenever you see complete omission, no, you should be very happy. Okay, just pass the entry over, finish, end of story. Correct? What is the correct entry? I mean, what is the entry for this? Telephone charges debited 562. Accrual to outstanding telephone charges 560. If it was telephone charges paid, no, they would not give you as a rectification because they know you know the correct entry. Outstanding telephone charges they are testing whether you know or not. What is the correct rectification if you go into next stage? Same. It is going to be same. Correct. And if you are going into third stage, telephone charges will become P&L adjustment. And outstanding telephone charges will be same because it is liability. It will remain same. Are you following this? Can we go further? Yes. Next. A bad debt of 1560 had not been written off and provision for doubtful debt should have been maintained at 10% of trade receivable, which are shown in the trial balance at 23,390 with a credit provision for bad debt of 2320. Okay, what and all they have spoken. Now, here it is independent. Every error is independent. But in exam, there can be a question like this, rectification of errors. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In the last one, they have given about this. So when you are talking, no, sir, can you see debtor amount is given over here, 23,390. There when you are doing it, right, you have to go up and see in any of your rectification entries, did the debtor change? You have to go and see whether the debtor has changed. This is in the trial balance, right? Trial balance was with errors, right? That's why you are sitting and doing rectification, right? So in the exam, if you have 10 entries or 10 errors given, 1, 2, 3, 4, 5 and so on. And last one is this one. That time you can't just rely on the question. You have to go back. You can't rely on this point. You have to go back and see other points where you have passed rectification entries. Where is there customer involved? If customer is involved, the customer balance has changed. On that changed balance, you have to do the rectification. Is this clear? Now, in this rectification entry also, there has been a situation where we had debtor, but I am not considering it. I am treating every error independently. Is this clear? No connection between one error and other error. But in exam, just remember this point. Now, beautiful error, right? Bad debt how much? 1560. Had not been written off. So we have to write it off. We have to write it off. What is the correct entry for bad debt? Bad debts debited 1560 to debtors 1560. Bad debt correct entry is bad debt to debtors. Okay, now next. And provision of 10% has to be maintained. Trade receivables are shown with the credit provision of for bad debts of 2320. So now tell me what should happen over here. When we have provision, bad debt will be taken from provision or will it be taken from profit? It will be taken from provision. That was the reason you maintained the provision. So when you have provision and if there is bad debt, remove the bad debt from provision. If there is no provision, bad debt will get debited to P and L. Bad debt will get debited to P and L. It's a loss rate. Okay. Provision means what? You took money and kept it aside for the loss. When the loss happens, take it from here only. If there is no money in the side, when the loss happens, take it from P and L itself. Are you following this? Clear? Now in this case, do you already have provision of 2320? Minus from that 1560 is gone. Correct. So you have 760 rupees still provision. Correct. Do you have debtors? 23,390. Can I calculate provision on this? No, because bad debts have happened. Bad debts are how much? 1560. So 23,390 minus 1560. You have 21,830. On this you have to create provision. On this provision into 10%. That means 2183 is the provision that I require. How much do I have? 760 is the provision that I have. So minus 760. 2183. So you need 1423 of provision. Are you getting this? This is a very important point for rectification as well as final accounts. Okay. So first what you have to do, bad debt will reduce the debtor also, and whatever bad debt will reduce the existing provision also. Then you calculate on the reduced debtor, you calculate the provision percentage. Okay. You get the provision, see how much is existing. Only difference you create. Now how much provision should I create? 1423. 1423 is a provision that I have to create. Can you tell me the journal entry for 1423? P&L account debited 1423 to provision for doubtful debts 1423. That's it. Is this clear? So now tell me what is the wrong entry. No entry. Wrong entry is just no entry. They did not pass the entry only. Okay, so now what will be the rectification entry? You should be very happy. Same thing you're going to put over here. What should be the rectification entry? Same thing you're going to put over here. What should be the rectification entry? Same thing you're not going to put over there. Are you getting this? Okay, don't go in the flow. Bad debt will not remain same. This will be P&L adjustment. Debtors will be same. P&L will be P&L adjustment. PDD will remain same. Is it clear, guys? Yes, that is your 8th one. Next, that was the 7th one. 8th. Tools brought for 1,200 had been inadvertently debited to purchases. These are some of the errors which are like easy for you. You know what? Instead of putting into your pocket, if you put into your friend's pocket, simple. Remove from friend's pocket and put it into your pocket. Instead of tools, what did you do? Purchase. Record the tools. So you'll write tools account debited to purchases. Okay, how much is the amount? 1,200. You should be very happy. What should be the rectification entry for after preparation of trial balance? Same thing. In the next accounting stage, tools will remain same because it is asset, and purchase will be P&L adjustment. Are you following this? Yes. 9th rectification. Okay. Proprietor had withdrawn for personal use goods worth rupees 1960. No entry has been made. Oh. You should be very happy. No entry when you see, you should be very happy. Drawings account debited 1960 to purchases 1960. Imagine in the exam you saw no entry was made. You are very happy, but you don't know what is the entry only. Are you getting my point? You saw no entry was made, okay. But when you saw the twist, you are like, what to pass entry for this? But okay, so now what should be the entry in the next stage? Drawings account debited to purchase. Now when you go to the third stage, will drawings remain same? Yes. What about purchases? It will become P&L adjustment. Clear? 10. Total of debit side of expense account has been casted in excess by 50. Has been cast in excess. Total of debit side of expense account means what? Debit side of expense means what? Expense only, no? has been casted in excess means what? You have put extra expense to remove. What should I do? I should credit. So I'll write 2 expenses 50. Clear? 2 expenses 50. When I'm going to do the rectification after preparation, 2 expenses will still be there, but then I will also add suspense account debited 50. One-sided error, I should not leave them alone. Okay, now suspense will be same suspense only, and expense will become P&L adjustment. Now in the third stage of rectification, right? Students' mindset. Third stage of rectification, they know that if expense or income is there, we should put P&L adjustment. But moment in the third stage of rectification, when you get a journal entry which says suspense account debited to P&L adjustment account, suddenly they feel, did we go wrong somewhere? Two also some different things we are seeing. Suspense and P&L adjustment have no connection. Suspense is coming because there was one-sided error. P&L adjustment is coming because there was income or expense. Clear? So don't get confused if you see both of them in the same journal entry. 11. The sales account had been totaled in short. Totaled in short means what? You put less sales. Very good. 2 sales, 100. Then what will be the next stage? Suspense. Put the sale also and write suspense account debited 100. And here suspense will be same, but sales will become P&L adjustment. Is that clear? Now, 12. Supplier account has been overcast by 25. Supplier means who? Creditor. Who is a supplier? Creditor. Overcast means what? Did you put more? Did you put less? We put more. To remove a creditor, what should I do? Debited. So I'll write creditor account debited. How much? 225. What should be the rectification entry if it is in the other stage? Creditor account debited to suspense 225. Creditor will remain same if you go to the third stage, but suspense will become also same. Oh, yeah. Will be same. 13. Next, sales return of 100 from a party has not been posted to the account, though the party's account has been credited. Party has been done. Don't worry. What is not posted? Sales return. What is the correct entry for sales return? Sales return account debited to. Correct entry usually sales return account debited to debtor. Debtor is done. Credited. So now you write sales return debited 100. What should be the rectification entry if you are in the next stage? Sales return account debited to suspense. Correct? Will sales return remain sales return only? No, it will become P&L adjustment. Suspense will remain same. 14. A check for 550 issued to supplier's account shown under trade payable, that means creditor, okay, towards his due has been wrongly debited to purchase account. Wrongly debited to purchase account. What should have been debited? Supplier should have been debited. So rectification entry should be creditor account debited. How much is that? 500. Creditor 500 to what? Purchase. Remove that purchase which was wrongly debited. Now what should be the rectification entry if you are in the next stage? Same. If you are in the next stage also it will be same. But creditor will remain same. Purchase will become P&L adjustment. Is this clear, guys? Yes. See, on the previous day of the exam, you can't sit and solve all questions of rectification, right? Can you sit and see every question of rectification? It's not possible. So you will have to solve something like this which covers everything. Because otherwise you will feel FOMO, right? Something you have missed. We don't want that. Yes, guys. Can we go further? That was 14. 15. Huh? Then once we finish rectification. Only. Okay, I don't know the word break. Don't even ask me. No break. All the way we are going till 8:30 without break. Do you know camels? Camel. It will store food. Huh? Do you know cows? They eat more. Then they'll bring it back and they'll eat slowly. Do you know that? Did you know the technology that cows use? You thought what? Cow is always chewing gum, is it? Always like this. They are bringing the food back. And it's a good, what do you say? It is a good defense skill for those animals. You know why it is there? Because these animals, even deer and all, they have that skill, okay? So these animals usually have that because if enemy is nearby, they don't have the time to enjoy the food. So they eat fast. Then they run away. And wherever no enemy is there, they'll enjoy the food again. They'll bring it back and they'll enjoy the food. That is why it is there. So same way, when time is less for the exams, you have to study fast and you have to write in the exam. Clear? No connection, but still I told. Okay. Yes, 15th one. A credit sale of 50 has been credited to sales and also to trade receivable. Crediting to sale is correct, but crediting to trade receivable is not correct. So what should you do? You have to remove that. So you have to write trade receivable debit. How much? 50, right? 50. What about next stage? Trade receivable remain. Oh, trade receivable will remain like that only. But you will write to suspense 50. And in the next stage, it will be same. Clear? No expense or income. 16. A sale for 2,300 to Mr. Lala was posted to the credit of Mrs. Mala. Sale should be actually debited or credited to customer. Customer debit. First of all, they put to wrong person and wrong side. Are you getting my point? Whenever you see two names, you will be like, instead of that guy, this guy. Done, that's it. No. Wrong person, wrong side also has happened. You are supposed to actually debit Lala. Not done. Go and debit it. Lala debited how much? 2,300. And Mala, what did you do? Credit. So remove. Mala also debit 2,300. Now what is the rectification entry over here? Lala, Mala are there. 2. Suspense 4,600. Rectification entry next stage will be same. Clear? 17. So when you see two names, you are not just going to think that instead of this. You are going to see what they have done also. Yes. The total of the returns inward book for July 1,240 was not posted in the ledger. Total of which book? Return inward means what? Sales return. So can we just write sales return debited 1,240? Should I write to debtor also? Total is not posted. Total will affect only one side. Are you getting my point? You entered only wrong amount, then it will impact both sides. So what should be the rectification entry in the next stage? Sales return account debited to suspense. Suspense will remain same. Sales return will become P&L adjustment. Is that clear? Next, 18. Freight paid on a machine 5,600 was posted to freight account as 6,500. 10% depreciation is charged on these machines. Did they miss the machine or did they record the machine by mistake? Did they miss the machine or record the machine by mistake? They missed the machine itself. Freight paid on machine should be added to machine. It should be added to machine. What did they record? Posted to freight account. Posted also okay. As 6,500. Are you getting my point? Two hands they could have made mistake. Third hand also they made mistake. Are you getting my point? Depreciation also gone. Now tell me what should be the entry? Machinery account debited. Machinery debited 5,600. You should do it. Correct? Now you should remove that wrong freight. To remove wrong freight, what will you do? To freight 6,500. Correct? So here one missing figure is there that we can't do anything because we are in the first stage. But we have to pass one more entry, that is depreciation. So you will write depreciation account debited 560 to machinery 560. Can you see this? Asset missed, depreciation missed, put the asset, put the depreciation also. So now when you rectify this, everything remains same, but here suspense account debited 900 to match the entry. Second entry is anyways matching 560. Clear? Machinery will remain same. Suspense will remain same. Freight will become P&L adjustment. Depreciation will become P&L adjustment. Machinery will remain same. Sir, why we are doing all this circus double? Can't we do on compound entry? You can do it. Okay, you can compound this and pass on rectification entry also, no problem. Okay, 19. While carrying forward the total in the purchase account to the next page, 65,590 was written instead of 56,950. Please tell me, did they put more or did they put less? Did they put more or did they put less? Total should have been what? 56,950. They put what? 65,000. To remove the purchase, what should I do? Credit the purchase. To remove the purchase, I will credit the purchase. 65,590 minus 56,950 makes it 8640. Clear? Now when you are rectifying this side, what will happen? Everything is fine. One extra fitting, that is suspense account debited 8640 to purchase. Will suspense remain same? Yes. Will purchase remain same? No, it will become P&L adjustment. Is this clear, guys? That was your 19th one. $20. Sir, today's class is not live. What you're seeing now is live only. Question number 15, someone is asking some doubt. Question number 15. Credit sale of 50 has been credited to sales account and also to trade receivable. Crediting sales is correct. So don't have to bother about that. Sir, wrong 50, sir. No, it's correct. It's correct. No, don't worry, guys. 20. Okay. Good morning. Till night we'll be telling good morning. Okay. A sale of machine on credit to Mr. Mehta for 9,000 on 30th September 2021 was not entered in the books at all. Book value of the machine was 6,750. Now, in fact, if they had given depreciation rate, depreciation also will be there. Now, what you are going to do? Not entered. Okay, and it is sold on what? 30th September. I want to add the depreciation rate. Let's say depreciation 10% WDV. If I tell original cost from where we'll search the cost now. Are you getting my point? 9,000 is book value of the machine is 6,000. That is not cost, right? If I tell you 10% on cost, I have to go back in time. Time travel I have to do. Okay, 10% WDV. So now sale is missed, but it's sold on what day? 30th September 2021. Let's assume that they are following calendar year. I'm just taking the assumption that they are following calendar year. So if it's calendar year, first what I will do? I'll pass the entry depreciation account debited to machinery. And the value was 6,750. So I'll write 6,750 into 10% into 9 by 12. If you follow financial year, it would have been 6 by 12. Clear? 675 into 9 divided by 12, you're getting 506.25, 506. Is it clear? Now what is going to happen? You're going to sell the asset. You're selling the asset at what value? 9,000. You sold the machine on credit 9,000. So what should be the entry? Mehta account debited 9,000. Mehta debited 9,000. To what went? Machinery. What is the machinery value? 6,750 once upon a time minus 506. It is 6,244. After depreciation, machinery value went down, no? To P&L 2,756. Is it clear? Are you following this? What is the rectification entry if we are in the next stage? If you are in the next stage, what is it going to be? Same, same but different. Same. Line also went. It's okay. No issues. Okay. Depreciation will remain as P&L adjustment. Machinery will remain same. Mehta is still Mehta only. Machinery is also still machinery only. P&L will become P&L adjustment. I hope it's clear, guys. So asset rectification entries are little tricky, especially asset sale. Asset sale, whenever it happens, you have to go and remember what is done in depreciation chapter. Clear? Question number 21. No, in the question they'll tell you. If they don't tell you, assume it's calendar year or anything and just write a note. Write a note. Okay, 21. The total of the purchase book of one page 4539 was carried forward to the next page as 4593. Did you put more or less? So how much more did you put? 54 rupees. So you'll write 2 purchases 54. Next what will you do? 2 purchases will still be there. You will write suspense account debited 54. Suspense will still become same. Purchases will become P&L adjustment. Is this clear, guys? Next, 22. Next one, 22. A sale of 573 was entered in the sales book as 753 and posted to the credit of customer. Posting to the credit of customer, is there any problem? No. But you entered in the sales book only as 753. That is the problem. Sale of 573 was entered in the sales book as 753. When you enter wrong, both the parties are affected. So now, what should be the rectification entry? Should you record the sale? Should you record the sale? Already sale is recorded for more value. So what should you do now? Reverse the entry. So can I write sales account debited to debtor? Sales account debited to debtor. So 753, how much? 180, very good. 180, clear? After that everything same. Is there any problem? Same thing will come this side. Now will sale be same? No, sale will become P&L adjustment. Debtor will still remain debtor only. Are you following this, guys? Yes, 23. Okay. A return to a creditor of 510 was entered in the return inward book. Return to creditor should be in which book? Return outward book. However, creditor account was correctly posted. We put in wrong book, but we did one correct entry there. So now what we have to do? Return outward is not recorded. Return outward is recorded. Oh, sorry. What am I talking? Return outward is not recorded. Return inward is by mistake recorded. So what should I do? I should record the purchase return. So I will write 2 purchase return 510 and I will write 2 sales return 510. Why? Sales return I want to remove, purchase return I have to put. Okay, what about the creditor? That is correctly done. Even though they put in the wrong book, they did 1/2 correctly. So now, next stage what will be the rectification? Same thing, but suspense account will be debited 1020. Clear? And next, suspense will still remain same. These two guys will go into P&L adjustment. Is this clear? Are you following this? Few more rectification entries. Okay, then we'll be done with rectification. Twenty-four guys. Cash received from C Das 620 has been posted to the debit of G Das. Oh, simple, sir. Instead of C Das, we have put it into G Das. No, sir. When we receive from C Das, we actually credit C Das, but we have debited the wrong person also. Wrong side, wrong person. So now, did you do anything with C Das? No. So can we write 2 C Das 620 and also 2 G Das 620. Okay, then here what will you write? Suspense account debited 1240 to C Das 620 to G Das 620. What is the reason behind the 2 Dases? Okay, C Das is for what reason? We have not done it. Jidas is for what reason? It was wrongly debited. Clear? Now rectification entry, suspense will remain same. Why? Everybody will remain same. Clear? 25. 25th one. Goods worth rupees 840 were dispatched to a customer before the close of the year, but no invoice was made. That means goods are sent. We did not record it. We did not record. We should be very happy. The entry is what? Debtor account debited to sales. Debtor account debited to sales 840, 840. 840, 840. Same. But here this will become P&L adjustment. Clear? Only sales will become P&L adjustment. 26. Goods worth rupees 1000 were sent on sale or return basis. Okay. To a customer and entered in the sales book. Okay, very good. That is what they're supposed to do. They've entered it. At the close of the year, customer still had the option to return the goods. Sale price was 25% above cost. At the close of the year, if it is not accepted, not rejected, what should we do? We should reverse the sale entry. Sale entry is for how much? 1000, right? So you'll pass the entry, sales account debited 1000 to debtor 1000. Clear? That's it? No. You should also write closing stock on approval debited to trading account. How much? How much? 1000 doesn't look like a nice number. We'll make it 800. Oh, 800. Why 800? Profit percentage is 25% on cost. 25% on cost is 25 by 125 on sales or 20% on sales. So this becomes 1000 minus 20%. Is this clear? What about the rectification entry in the second stage? Will be same. Correct. And sales will become P&L adjustment. Debtor will remain same. And closing stock on approval will become same. Trading account will become P&L adjustment. Is this clear? This is 26. Let's go into 27. Little more. You can see the finish line now. Okay. Repairs made during the year were wrongly debited to building account. Just reverse it. Okay. Right. Repairs account debited 12,500 to building 12,500. What is our next stage? Same. Is it going to be same? Okay. Now repairs will become P&L adjustment and building will remain same. Okay. 28. Addition of the freight column in the purchase journal was short by 15,000. Freight column is short in the purchase journal. Purchase journal means purchase book. You have in the subsidiary book one question with freight column in that. Now, what was short? Purchase journal. So, freight was short. So, what should be the entry now? Freight account debited. How much? 15,000. That's it. What about the other party? That is done. They have not told anything. Okay, so now what happens? Freight account will be transferred this side, not like that. Okay, to suspense 15,000. What about rectification entry? Freight will become P&L adjustment. Suspense will remain same. Now you can also assume that both sides are missed. If both sides are missed, rectification entry over here will become freight account debited to creditor. Freight account to creditor if both sides are missed. So 29. Goods of the value of 4,500 returned by a customer Shiva and Company has been posted to the debit of Shiva and Company, also to sales return. Sales return we have to debit only, correct? Customer has to be actually credited. What did they do? They debited the customer also. So what will we do now? We have to credit the customer. So we'll write to Shiva and Company. How much? 4,500 becomes 9,000. Instead of the credit, they had done debit. So it will become double effect. So when it comes to the next stage, it will become, Shiva and Company will remain same. And you will get additional suspense account debited 9,000. What about suspense? It will remain Same. Oh, both also will remain same. Same. Okay. Okay, 30. 30th one. Now, sundry items of furniture sold for 30,000 has been entered in the sales book, the total of which has been posted to the sales account. That means, what is the mistake here? Instead of furniture sale, they have taken it as goods sold. So now what will you write? Remove the sale. You will write sales account debited 30,000 to furniture 30,000. Luckily for you, they have not spoken about depreciation. All those concepts are not there. So next stage, what will happen? Same thing will be there. Correct? After that, what will happen? Sales will become P&L adjustment. Furniture will remain same. Last one, 31. A bill of exchange received from Miss Sapna for 75,000 had been returned by the bank as dishonored and has been credited to the bank and debited to bills receivable account. Good morning to bills of exchange. Tell me, what is the entry for bill dishonored, which was earlier discounted? What should be the entry? Good morning to bills of exchange, guys. What is the correct entry? Correct entry will be what? Sapna, right? Sapna account debited. What was the Sapna? 75,000. Sapna account debited to no bill, bank, because it was a bill discounted which is dishonored. Now, what is the wrong entry that they have passed? Wrong entry. Can you see? Credited to bank, correct, but debited to bills receivable. So, wrong entry is bills receivable debited 75,000 to bank account 75,000. Is that correct? So, what should be the rectification entry? Bring the Sapna back in your life. Sapna debited to bills receivable 75,000. Clear? Next stage. Next stage will be same. After that stage, Sapna and bills receivable both will be same. Is it clear, guys? Yes. This is your rectification. All 31 we have finished. Okay. Next we have to go into bank reconciliation statement. Do we need a break?
Yes.
For breakfast? You are not at breakfast?
There.
It is not there. No. 10:52. 30 minutes. We'll be back at 10:52. Okay, students, let's begin. We are back for the next session. What are we going to now? We are done with the rectification. We are going into BRS. BRS is another maximum potential 10 mark question. Maximum potential 10 marks. Can they ask it for 5 marks in the exam? Yes. Okay, usually there is a question from BRS which is always there in the exam. Okay, now, guys, what is bank reconciliation statement? Is it a ledger or journal? Statement, yes. Statement reconciling the difference between cash book and passbook. But what cash book? Cash book only bank column. We are only worried about the cash book, bank column. We are not worried about anything else. Cash book, cash column and all, it's irrelevant to us. Okay, so that is what is bank reconciliation statement. Now, cash book, bank column. Focus on cash book, bank column. Records maintained by business. Who is maintaining the records? Business. About transactions in our bank account. What we are doing in our bank account, we are recording in our books. That is where cash book, bank column. Clear? What is passbook? Whatever transactions we are doing, bank also will maintain the records. That is passbook or bank statement, records of transactions done in our bank account, maintained by the bank. Maintained by the bank. Is it clear? Now, in our records or our books, bank is always an asset for us. We have money somewhere. Whenever we want, we can take it back. Bank is an asset. So therefore, assets have debit balance. Clear? In books of bank, in books of bank, we are a liability for them because whenever we ask the money, they have to give it back to us. So we are liability, and that's why there is credit balance. Now, if you remember, anytime you get money into your account, you will get a message. Amount is credited to your account. Amount is credited to your account. Clear? That means bank is crediting your account. That means for bank, you are a liability. Whenever you make payment, you will get a message. Amount is debited to your account. Amount is debited to your account. Is it clear? That means the liability for the bank decreases. But that same amount that you receive or same amount that you pay, if you go and pass journal entry, that time when you receive, you will not credit, you will debit the account because for you asset increases. And when you pay, you will credit bank because for you asset decreases. Clear? So you are just seeing from two sides. Normal balance, OD balance. What is OD balance? Overdraft, full form. Thank you very much. What does it mean? That means you have taken money more than what is there in your account. Clear? Now, imagine you have 1,000 rupees in your account. Today evening when you are going home, you go and stand in front of the ATM and you will tell, oh ATM, please give me money. Okay, and you will press over there 1,200. Will you get 1,200? You just told no, OD means taking more money than what bank is giving. Only if bank gives that facility. Only if bank gives that facility, then you will get it. Otherwise, you can only take 1,000. Clear? So, overdraft facility has to be given by bank and then you can take more money than what it's actually there in your account. Is it clear? Okay. So, now, in our books, if there is favorable balance means what? You have money in your account. If you have money in your account, favorable balance, that means for you it is asset and asset will be debited. But for bank, if you have money in the account, bank doesn't like it. Bank doesn't like it. For bank, you are a liability. Bank can survive only if you don't have money in the account. Bank will be happy if you have OD because on OD they will charge interest. So in bank's books, okay, sorry, it should have been here. Okay, in bank's books, unfavorable balance for you what? Unfavorable means what? You have taken more money. Should you return it? Are you Vijay Mallya to not return? No. So you have written it. So liability, credit. Clear? So therefore, for you, what is it? I mean, for you it is credit, liability, but for bank, what is it? Asset. Bank is very happy. When you take more money, bank is very, very happy because it is asset for them. For you, you know for bank, what is the biggest asset? Not land and building. Not land and building. It is loans. Loans advanced is the biggest asset for bank. Okay, now, let's go further. Cash book, passbook. You just have to understand the movement of balance. Movement of balance. When money comes, money goes. What will happen to the balance? That you have to understand. Cash book or passbook, the movement of balance is same direction. Movement of balance is same direction. That means value increase, value decrease is same direction. But debit credit is opposite. Clear? Because for us, if it is asset, for them it is liability. For them it is liability, it is asset for us. Clear? Now, normal balance. When money comes in, imagine you have 500 rupees in your account and I send you 200 rupees. What will happen to the balance? Balance will increase. Clear? And you send me 200. That time what will happen to your balance? Balance will decrease. Can you see? Money comes in, balance increases. Money goes out, balance decreases. Even in bank, balance increases. Even in bank, balance decreases. But if at all you are debiting your books because for you it is asset, bank it will be credited because it is liability. Clear? If you're crediting the books because asset decreases, bank will debit because liability decreases. Are you able to follow? Because they can just tell amount is debited in the books of the bank or amount is credited in the books of accounts. Now, overdraft balance. What is overdraft balance? OD balance. That means negative balance. Clear? Money comes in, balance decreases. Because already you have taken money from bank. Already you are sitting in negative balance with bank. Now suddenly if somebody sends 200 rupees, what will happen to that negative balance? It will decrease. Are you getting my point? You have already taken negative balance. So when money comes in, negative balance decreases. Okay, when money goes out, already you have to pay money to the bank. Again, you have taken more money. That means balance increases. And here for us, OD is a liability. So when liability decreases, debit. When liability increases, credit. Clear? So for you if it is liability, for bank it is asset. They are very happy when liability asset decreases credit and asset increases debit. Are you able to understand this? So this movement of balance is very, very important. This movement of balance is very, very important. Are you getting my point? Because you will be using the hand movement method only. But you need to know when you hold the hand like this, which side DJ you have to play. Are you getting my point? So you are holding the hand like this, then you don't know what happened. Balance, increase or decrease. Are you getting my point? So movement of balance is very important. Usually you get confused with movement of balance when it is OD. When it is OD. OD, what you have to remember? Simple thing. Okay? No opposites. We are always thinking in one angle only. I know some of you are doing it. Whatever happens in cash book will happen opposite in this. Okay? I don't know that. Okay? OD. OD means already you are sitting in negative. So, if at all you take money, that time balance increases. If you put money, balance decreases. Is it clear? Now, let's go further. Cash book and passbook not telling us. Okay, causes of difference between cash book and passbook. Some of the common ones I have written. What are the causes of difference? Clear? Check deposited but not credited. What does it mean? Check deposited, not credited means what? I went and put the check into the bank also. When I put the check into the bank, in my books I will record it. But in bank, they have still not given me the money. That means, can you see there is a mismatch here? Cash book entered, passbook not entered. Is it clear? Check deposited, not entered in cash book. Check deposited, not entered in cash book. That means I have deposited the check. When I deposited the check, I forgot to enter in cash book. But does it mean that bank also will miss it? No, bank has entered. So here it is. Cash book not entered, passbook entered. Now here there is a problem. You know, students when they see in the exam, now check deposited, they don't read further. Check deposited means okay, check deposited not credited. They will not read further. It can also be check deposited not entered in cash book itself. Clear? Now, check issued not presented for payment. Can they also write this as check drawn? Check drawn. You know what is check drawn? Writing the check and giving is called as check drawn. So if you have drawing the check, that means you have issued the check. Check issued not presented for payment means when you issued the check, you have already entered in the cash book. In passbook, it is not entered. Is it clear? Are you following this? Now, check issued not entered in cash book. You gave the check, everything is fine, but you did not enter in cash book. That means passbook it is entered. Just like rectification. Okay, how I told you in rectification, whatever they tell in the question is error only. Same way in BRS, whatever they tell in the question is difference only. It's difference only. Because they tell, following differences were noticed between cash book and passbook. You cannot tell, oh, this is both the places it was entered. Are you getting this? They told heading only, following differences were noticed. Clear? Now, bank charges charged by bank. Obviously, bank charges have to be charged by bank only. Correct? But when bank is charging bank charges, they will not call you and ask your permission. Will they call and tell, hey boss, should I deduct the bank charges? No, right? They'll just cut the money. They will not even inform you. If you look at the bank statement, you'll get to know. Now, cash book not entered, passbook it is entered. Interest charged by bank. People get confused with this interest part. If they tell interest charged by bank, that means bank is collecting interest. Bank is, not collecting, bank is giving interest. Bank is taking interest from you. Now, sometimes they use the word interest collected by bank. Interest collected by bank. Now, you have to understand two things. Sometimes they'll tell interest collected by the bank on behalf of the customer. That means from somebody they collected the interest and gave it to you. If they only tell interest collected by bank, that means they took it from you. Clear? If they tell interest allowed by bank, that means they are giving you interest. Is this clear? Are you following this? Now, bank also does services. Bank also provides services. What are the services bank provides? They'll be like, don't worry, I will work like your agent. Somebody has to give you interest, I'll collect and give you. Somebody has to give you dividend, I'll collect and put it over here. Correct? So if they tell interest collected on behalf of customer, that means it is coming in. If they just tell interest collected, that means they are taking from you. Is this clear? Now, interest charged by bank, money goes out, so cash book not entered, passbook it is entered. Interest allowed by bank, money comes in, cash book not entered, passbook entered. Why both the places cash book not entered? Because bank will just execute these transactions without even telling you. Then later when you cross check, that time you get to know there is a difference. Clear? Entered in cash column instead of bank column. Entered in cash column instead of bank column. That means cash book not entered. Sir, what are you talking? Here it is told entered. Entered in which column? Cash column. We are not worried only about cash column. See, when we started, what we did well? Cash book, only bank column we are focusing on. We are not worried about the other columns in the cash book. Cash book, bank column and passbook is what we are going to reconcile. Clear? So if it is entered in the cash column, it is as good as not entered only for us. So cash book not entered, passbook it is entered. Errors in cash book. Do you think bank also will make the same mistakes? No, that means that will create a difference. Errors in passbook. Do you think customer also will make the same mistake? No. Okay, these are the things that can normally happen. What method of reconciliation have you been doing? Hand method only. Anybody has been doing the plus minus method here? Anyone? No, right? Okay, good. Thank God. Anybody has been doing plus minus? Plus minus is basically buyouting. Then what is opposite? No. What is that? Hand only, no. No, okay, fine. Now don't go to change the methods. Whatever method you are following, follow that only. But I would explain to you with hand movement method. Okay, bank reconciliation statements. Okay, method of reconciliation. You have two hands. Sure. No? Huh? What? No. You have. How is it looking? Both same side, right? I like that only a click picture. Okay. Oh yeah. Okay. Right hand, left hand. Right hand, left hand. Now, holding right hand is not important. Okay, the important thing over here is which one, first of all, identifying which one moved. Which one moved? That means where did the transaction happen? That is first thing that is important. Second thing is you identified where it happened, but which side it moved. That is also important. Are you getting my point? Then the method comes into picture. I'm telling you, method is secondary. It comes afterwards. First of all, you should know right hand, left hand, which hand is right hand, which hand is left hand. Which hand is, no, not like that. This is like, every one of you would have one friend, no, who if they are given to navigate Google Map, Pakka they will be telling, right. Correct. They'll be showing left like this and telling right. Correct. One of you, one friend everybody will have. And there will be also one friend that after we go 300 meters front, then they will tell, there was one left. Correct. And once it happened, okay. So we were going in, and we were going somewhere, and we were going towards some place. I don't remember the place. So my friend was trying to act over smart with Google Map. So he is like, see, we have done it couple of times. It worked. If at all there is a flyover, and we have to go below the flyover, and below the flyover if there is traffic, so we take the flyover, come down, and then come back. Okay, you'll reach usually. Like literally you have to come in wrong way and all, that's a different thing. Okay, but you'll reach. So one day he tried the same trick. It was showing full red in the Google Map, just below the flyover. So he said, he didn't tell only. He said, we'll take the flyover, later we can come back. It was showing 5 minutes to our destination. Moment we took the flyover, it is showing 28 minutes. You know which flyover we took? Electronic City flyover. Straight we went for a few kilometers, then went into that toll, took a U-turn and came back. Huh? No, I came by flyover only. Because down if you come there, it's blocked again. We came by flyover itself. We paid the toll and came back. Because no other option. It went. Then it took us inside the toll, took a U-turn and came back again. Just Bangalore stuff. Okay. Now, understand. I'm telling you, hand movement method I'm not explaining only first. First, what I'm explaining to you is, first you have to identify which hand is which. Are you getting my point? No, I'm not. I am not telling you right hand, left hand. Right hand, left hand, you should know. You should know which is right hand, which is left hand. What you are expected to know is, right hand is what? Cash book or passbook. Left hand is what? Cash book or passbook. Which one will you assign? No. What is told in the question? What is told in the question? If they tell starting point is cash book, how can you put right hand as passbook now? Right hand will become cash book. So always right hand is your starting point and left hand is your ending point. Right hand is your starting point, left hand is your ending point. That is one thing. After that, next thing you have to identify in the transaction, what has moved. Only one thing has moved, guys. Both cannot. What has moved? Okay, if at all right hand has moved, when you identify what has moved, next thing you have to identify, has the balance gone up, has the balance gone down? Second thing. Once you have identified that, then you come to the method. If right hand moves, we don't like right hand, okay? Okay, if right hand moves, reverse it. If it has gone up, bring it back. If it has gone down, take it up. Okay, reverse it. Clear? If right hand has moved, that means you have to bring it down. So minus in your BRS. If right hand has gone down, that means you have to bring it up, plus in your BRS. Clear? Left hand is crazy, closer to heart, right? Okay, crazy. If it moves, move the right hand. So what your heart tells, follow that direction. Are you getting my point? What your heart tells, follow that direction. So left hand moves upwards, right hand also will move, plus. Left hand moves downwards, right hand also will move downwards, minus. Your heart is telling CA only, okay? Your heart, now don't tell. Sir told heart, whatever heart tells, you have to follow that direction. And we'll quit CA and do something else. No, I'm telling this from experience. I'm telling this from experience. It has happened to me. Yeah, it has happened to me. I had the school where I studied. There only I got an opportunity to teach long back, okay? The school where I studied, there only I was supposed to go for CA foundation classes. Back then it was called CPT. Okay, CPT class I was supposed to teach. So I was full motivated and pumped up. Crazy, I was on the streets. Now I'm here teaching. Okay, I proved a point to my teachers. I was fully pumped up. I went inside. Okay, when I went inside, I thought, let me give some crazy motivational speech. Okay, I gave crazy motivational speech. I told, whatever you want to do in life, you have to do that only. Okay. Crazy, right? Okay. Whatever you want to do in life, you have to do that only. I told, if you want to do CA, you should do it. Don't do it for anybody's force. Okay. If you have decided that your interest is somewhere else, go and follow that passion. Like that I gave a speech. First of all, in that class, only 10 students were there. Okay. Second day, no, 9. I thought one person can be absent. Okay, no problem. The next day also I saw it was 9 only. After that day also it was 9 only. Then one day I got one call from an unknown number. Okay, unknown number, that girl who was absent, her mom called. Telling that, sir, this girl, she is not attending CA foundation classes. I'm like, okay, maybe some health issue, something like that. Okay, they are going to tell. So she said, this girl is not attending CA foundation classes, sir. Because, and she has scored 400s in her 12th standard. All 4 core subjects she has scored 100. That's why we told you should do CA. Okay, but now she is not interested with him. She wants to do some interior designing or something. Or fashion designing. Something she wanted to do. Okay, none of them she wanted to do. Then, can you talk to her? By then I understood. That is because of me only. Okay. Then when I spoke to her, she said, I'll come and talk. Okay. Then when she came and spoke, she said, sir, you told me, sir, whatever you want to do in life, you should do that only. I got really motivated. I don't want to do CA, sir. Everyone is just forcing me. And she never came back to CA after that. She did some, I think, interior designing or fashion design. One of them she did, and she's doing that only. So, your left hand heart is telling CA. Are you getting my point? Okay, don't change that left hand. Now, whatever left hand does, okay, whatever heart does, mind should follow. Clear? So, right hand. Hello? Wait. It doesn't apply to everyone. Okay? Some Jodi is sitting there. Whatever heart is telling, mind, don't follow it. See, I don't like loans. You gave me, I gave it back. Loan is paid off. With interest. Okay, guys. Shh. Listen. Okay, another 10-mark chapter. Let's focus. Now, if start point is normal balance, as per cash book, it can be normal balance as per passbook also, no problem. But when you do your plus minus, no add and subtract, you got a positive number. You started with normal, you got positive. Positive of normal is what? Normal only. So your end point also will be normal balance as per passbook, but other side. If at all you get negative of normal is what? OD. Then you will write it as OD balance as per passbook. Are you getting this? Imagine you started with OD. And when you did plus minus, you got a positive number only. It is still OD. When you did plus minus, you got a negative number. That means opposite of OD will become normal balance. Clear? Yes. If start point is OD balance as per cash book, end point is positive, then OD balance as per passbook. End point is negative, that means normal balance as per passbook. Is this clear, guys? Yes. Adjusted cash book. Adjusted cash book means what? Cash book which is adjusted. Correct. So that means cash book is already prepared. What and all? See, so many differences are there, no? Yes, Praveen, what were you telling? The same thing. Okay, so many differences are there, right? Some things are because of us, some things are because of bank. Correct? Whatever was because of us, what is that? Bank charges, I did not enter. Enter it. Done, no? No difference. They gave interest, I did not enter. Enter it. They took interest, I did not enter. Enter it. These are the things which were under my control. Bank made mistake. Is it under my control? No. I made mistake. Is it under my control? Yes. So if I made the mistake, I can always rectify it. So adjusted cash book means pass entries to adjust the cash book balance before reconciliation. So don't go and do reconciliation, make your reconciliation so big. So things which are under your control, get it sorted. Okay. Items entered in passbook, not entered in cash book. Enter it. Errors in cash book, rectify it. Only two things. Items entered in cash book, not entered in passbook. Items entered in passbook, not entered in cash book. Enter it. Done, no. No more difference. Error in cash book, rectify it. Done, no. No more difference. Is it clear? Now, after preparation of adjusted cash book, use the balance in adjusted cash book to prepare BRS. Imagine full adjusted cash book we prepared. After that, we took the balance which is given in question only and did the BRS. Are you getting my point? Then it would have been waste of time preparing adjusted cash book. No. So whatever balance you got in adjusted cash book, take it. Now I have one question. When should we prepare adjusted cash book in exam? Only when they ask. Are you getting my point? Don't do it voluntarily. Some of the colleges know in 11th and 12th or some of the places, they tell that if it's at the end of the year, you should do adjusted cash book. No such concept for ICAI. If they tell you adjusted cash book, do it. Otherwise, everything will go into BRS. Is it clear? Yes. Let's go further, guys. Now, one more small question is there waiting for us. Bank reconciliation statement. Okay, bank reconciliation statement, master problem. Prepare BRS for the year ending 31st December 2021. Now, listen. Okay, listen. Go into your final division and then write Next thing, BRS. Okay, in BRS, I'll tell you what to do. First, read the concept, understand the concept. Then, master problem, master question. Okay, after that, last 4 attempts. Are you getting my point? It's not enough just to see the master question over here. You have to go and do the last 4 questions, because when you do the last 4 questions, you will be starting with different starting points. It will test whether you understood the concept. So, first we will do the master question, then we will do the last 4 attempts. Is this clear? BRS. Yes, Praveen, ready? Oh, Praveen. Are you ready? Yes. Now, you know what I'm starting with? OD. As per cash book. OD as per cash book. Now listen. Prepare bank reconciliation statement for the year ending 31st December 2021 from the following information. If starting point is balance as per cash book 1 lakh, balance as per passbook 1 lakh, OD as per cash book 1 lakh, OD as per passbook. You can take other starting points and try on your own. Now I'm doing only one starting point, that is OD as per cash book. Because what do you like actually, normal or OD? Huh? What do you like? Normal, right? Then we'll do OD. Oh, you like OD only? Then we'll do OD. What do you like? We'll follow it. OD as per cash book. Clear, guys? Now, no need to write it in your notes and all. No need to write it in your notes, because all that we have to identify is just plus minus. So here only in the side I am writing plus or minus. Is this clear? Here only in the side I am writing plus or minus. Only 20 are there. Only 20. Okay. Now listen. Okay. Silence. Get ready with your hands for DJ. But please don't look at my hands, because my hands are my hands, none of your hands. Clear? You know why? Because if you see my hands and move it, then you will be doing opposite. Because my right hand is your left hand. You have to do Gangnam style. Are you getting this? Okay, so please don't you follow your mind and your heart. Clear? Now, listen. What is your right hand? Everybody raise your right hand. What is your right hand? What is your right hand? Cash book what? OD. Cash book OD. Okay, so obviously left hand is passbook OD. Now, movement of balance. If money comes in, which side will your hand move? Money comes in, which side will your hand move? Money comes in, which side will your hand move? Downwards. Already you are sitting with negative. If somebody puts money, it will go downwards. Clear? And if money goes out, balance will go upwards. Clear? Because it is OD. Remember that. Okay. Now, get ready for the DJ. On 15th December 2021, payment side of the cash book was overcast by 10,000. Payment side of the cash book means what? Payment side of the cash book means what? Credit side of the cash book. Payment side was overcast, means did they put more payment or less payment? More payment. Where is the transaction affecting? Cash book or passbook? Cash book. Right hand is cash book. When they put more payment, what will happen to the balance? Balance increases because it is OD. Mind moved, heart did not move. What should you do? Reduce it. So minus. Are you clearing it? I think your God and mind. I changed this God into heart and mind. Yes. Is it clear now? Are you following this? See, no, there is no requirement of you when you are practicing BRS at home. No, writing full BRS, add, minus, all that is not required. There only if you are able to get plus minus, do it in the calculator, see the answer. Got it? Next question. You can solve more questions like that. Are you following this? In exam, you know what is the presentation. Now, did you get the minus? Everyone. Next. Check for 1,18,000 issued on 6th December 2021 was not taken in the bank column. Not taken in the bank column. That means who took it? Who took it? One person did not take. Who took it? Passbook. Passbook is which hand for you? Left hand. Check issued means what? Money going out or money coming in? Going out. What happened to passbook balance? Increase. Which hand moved? Left hand. Which hand moved? Don't look at my hand. Which hand moved? Left hand. Heart moved. What should you do? We also should move plus. Are you getting this? Trust me, it is like easy 10 marks in the exam. If BRS comes to 10 marks, easy 10 marks. Okay guys, hello. Good morning. On 20th December 2021, the debit balance of 8460 on the previous day was brought forward as credit balance in the cash book. Bamboo. This is one nice ICA bamboo. So what has happened over here? Debit balance is brought forward as credit balance. First of all, you tell me, debit balance means what? Debit balance means what? That means debit side there was more. Correct? Now they made it what? Credit. That means what has happened over here? What has happened over here? Now this adjustment actually for OD doesn't make sense. For OD doesn't make sense. Okay? So I'm just keeping it outside the OD purview. You know why it doesn't make sense for OD? Because debit balance of 8460 means starting point was not OD. Starting point was normal. Are you getting this, guys? So that is why I told after doing this also you will have to do exam questions, because in middle some are not applicable to OD. I'm taking this as normal balance. Did you understand why I can't take it as OD? Because they said debit balance of 8460 on previous day is brought forward as credit balance. How can I have debit balance when I'm telling starting point is OD? Starting point OD means it should be credit balance. Are you following this? So now debit balance 8460. Come back to normal. Come back to normal. Not OD now. Come back to normal. Debit balance means what? We had money in the account. That means bank also there was money. They made it what? Credit balance. If it has to become credit balance, once if I reduce, what will happen? Once if I reduce, what will happen? It will become 0. Once more if I reduce, it will become negative. Are you getting it? We were both sitting at 8460. Once if I remove 8460, it becomes 0 balance. Once more if I remove 8460, it becomes negative 8460. That means 2 times if the right hand has moved, what should you do? Add it 2 times plus. This is not as per OD, this is only as per normal. Are you getting this? Okay. Of the total checks amounting to 12,370 drawn in the last week of December, checks aggregating to 9,360 were encashed. 12,370 minus 9,360, difference is 3010. Now we are back to OD. No normal now. Back to OD. Where did you enter? Checks issue. Where did you enter? Cash book. Which is your right hand? Cash book. That means checks issued means what? Balance increases. OD. Balance increases. Now right hand has moved. You will reduce it. Minus. But minus for how much? Only 3010. 3010. Is it clear? Are you following it? Because out of 12,370 what you had given, 9,360 it has been reflecting in the bank, encashed only. What has not happened, that only you are worried about. Are you getting it? Next, dividend of 35,000 collected by the bank. We'll focus on dividend of 35,000 collected by the bank. Who has entered it? Bank. Bank OD. What will happen to balance? Left hand. Balance decreases. Left hand decreases. Right hand also should decrease. Minus. And here, fire insurance premium of 7,900 paid by the bank. Left hand, passbook paid by the bank. Left hand, balance increases because it is OD. So what will you do? You will also add it plus. Clear? Next, check issued to a creditor 1,75,000 was recorded twice in the cash book. Recorded twice in the cash book. Now understand this. Right hand cash book, left hand passbook. What happened when you issue check? Balance increases. Once it increased, no problem. But cash book twice, once more it increased. Did they do the same mistake in the bank? No. Right hand has moved extra. What will you do? Minus. Are you following this, guys? I know you haven't done BRS like this. You would have written only and put the things. You have done like this directly plus minus. Very good. That means you have solved more BRS questions. If you have written, you have wasted a lot of time. Are you getting it? See, some questions like partnership and all, you have to write and solve so that you get that speed. BRS and all, what is that? Just do it in the calculator also. If you get the answer, good. Billed for collection amounting to 53,000, credited by the bank on 21st December, but no advice was received by Mr. Karan. Who has entered? Bank. Bank is what? Left hand. Okay, credited by the bank means what? Bank gave you money or bank took money? Bank gave money. When bank gave money, what happens to the balance? Balance decreases because it is OD. So what will happen to right hand? Right hand also will decrease. Minus. Is it clear? Now, customer who received a cash discount of 3% on his account of 60,000 paid a check on 10th December 2021. Cashier erroneously entered the gross amount in the bank column of the cash book. Erroneously entered gross amount means what? Full 60,000 they put. Actually, how much you have received? 60,000 minus 3%. That means you have received only 58,200. So 1,200 did you put extra? 1,800 did you put extra? Did you put extra? Receipt or payment? Receipt or payment? Receipt. Customer who received a cash discount. Customer received cash discount means you received money. Which hand mistake is there? Right hand, cash book. Did you put extra payment? Yes, that means balance what happened? Decreased. Now what will you do? Add back. How much? Only 1,800. Only 1,800. Is it clear? So actually you received a check for 58,200. By mistake you wrote full 60,000 in the bank column. You should have actually written 58,200 and you should have written 1,800 in the discount column. Clear? Next. Checks amounting to 60,000 issued to creditors have not been presented for payment till date. Checks issued to creditor. Which hand you have written the entry? Cash book. When you issue check, what will happen to balance? Increase. OD. Increase. Minus. Is it clear? Are you following this? That's the most regular adjustment over there. Checks paid into bank amounting to 1,10,500, out of which checks amounting to 55,000 only collected. So 1,10,500 minus 55,000, 55,500. Is it now? Here, little sometimes students get confused. They're like, checks paid into bank means checks deposited. Checks paid into bank means checks deposited. Is it clear? So check deposited, only 55,000 is collected. So now check deposited. Who has passed the entry? Cash book. Right hand is cash book. What happens to cash book when check is deposited? Balance decreases because it is OD. Increase it again. Add 55,000. 55,500. Yes, 55,500. Rent amounting to 60,000 received by the bank and entered in the passbook but not entered in the cash book. Who has passed it? Right hand, left hand? Left hand. What happens to the balance? Decrease because you received rent. So left hand has moved. What will you do? Right hand also will decrease. Minus. Rent received. Rent received. When they tell only rent, it is always expense. They told clearly rent received. Okay. Now, insurance premium up to 30th June paid by the bank 2,700 not entered in the cash book. Let them pay till any time. Okay, if you're doing final account, then you sit and worry about prepaid and all that. Let them pay till 30th June 2022. Let them pay till 30th June 2052 also. No issues. Paid, right? Okay, not entered in cash book. What happens to the left hand passbook? Passbook balance increases. So right hand also will increase. Is it clear? Next. Payment side of the cash book had been undercast. Payment side of the cash book has been undercast means you did not put one payment. You did not put one payment. Did bank put that payment? So bank, what happened? Left hand increase. What should you do? You also will add it plus. Entire question is happening on OD except for this one because that could not be possible with OD. If you do it, it will be wrong with OD. Okay. Bank charges 150 shown in the passbook had not been entered in the cash book. Bank charges so regular. What happened to passbook balance? Increase. What will you do? You will also increase plus. Clear? Next, bills payable for 20,000 had been paid by the bank but was not recorded in the cash book. Okay, we'll do the first one. Not recorded in the cash book. Bills payable paid by the bank. That means left hand what happened? Increased. So you will also add it. Bills receivable of 6,000 has been discounted with the bank at a cost of 100 which was not recorded in the cash book. Bills discounted means what? Did you receive money? So what happened to passbook? Left hand is passbook. Passbook balance decreases. So what should you do? You also should decrease minus 5,900. Bamboo. You have to study bills of exchange. Otherwise, you'll go and write directly 6,000 here. Discounted means what? You're not getting full amount. You're getting 100 rupees less. So we are worried only about what we receive or what we pay. Next, check received rupees 10,000 entered twice in the cash book. Received, correct. Cash book balance decreases. Passbook also decreases. Cash book balance decreases again, which has not happened in the passbook. Add it back. Clear? A bill of exchange for 26,200, which was discounted with the bank, returned dishonored, but no entry was made in the cash book. Returned dishonored. That means what? Dishonor means what? They took money or they gave you money? Nothing. Yeah. The customer did not give you, but bank will take money from you. Okay. See, bill of exchange, which was discounted. When discounted bill is dishonored, right? We had it in the last rectification entry. Remember? When discounted bill is dishonored, bank will not ask your permission. Bank will just take money from you. So what happened to passbook balance? Increased. So what will you do? You will also add. Bank charges entered twice in the cash book. Last time you were not entering only. Now when you entered twice. Okay. One extra. So cash book balance once extra. So what will you do? Minus. Interest allowed by bank. That means did they give you or did they take from you? Did they give you or take from you? They gave you. Allowed by the bank. They gave you interest. So allowed by the bank means bank has passed the entry. What happens to the passbook balance? Decrease. What should you do? Decrease. Interest on investment 83,800 collected and credited by the bank, but the same has not been entered in the cash book. Interest on investment collected, right? So what happens to passbook balance? Decrease. You will also decrease it. Done. You will also decrease this. Done. Correct? Now, what is the topic? I forgot to ask that. What is the topic that is troublesome in CA Foundation accounting? What is the topic? Company accounts.
Yes, sir.
Some or nothing is troublesome. Partnership. How many of you at NPO? Activation. Did anybody already decide that they are going to skip partnership in the exam? No, right? If at all you are going to skip anything, that is first of all a wrong decision. But if at all you are going to skip partnership, I tell you it's a very, very wrong decision. Because ICA knows that a lot of students are skipping partnership. And if you see last many attempts, only one attempt, one question is there which is difficult in partnership. Other than that, all are simple questions in partnership. So now they will give simple in partnership. That means somewhere else one tricky question is there. So if you have skipped partnership from what you studied, tricky question comes. What you did not study, easy question came and it went. Are you getting this? So do not skip partnership. I know partnership is little small chapter. NPO is damn simple. Guys. Okay, let's start with the examination questions. Okay, we have to discuss the examination questions of last 4 attempts. We'll start with June, September, Jan, and May. Subsidiary book is tougher. Okay, first we are starting with June. All BRS question, guys. Yes. Let's start. Let's see if there is any BRS question. Is it there? Rectification, depreciation. Do we have any BRS question? NPO, resolution, no, starting it was not there. It's there somewhere here, I guess. Admission, incomplete records, inventory, BRS, yes. 5 marks. Okay, guys. BRS is asked for 5 marks. Zoom? Then I can't. Then full question won't be visible, right? To solve it. Why else? What is the wedding invitation? This is only name of the bride and groom we'll see, and venue and time we'll see. Why we want full? Yes. Okay. From the following particulars, prepare BRS of businessmen on 31st March 2024. What is the starting point? Overdraft as per cash book. Overdraft as per cash book. Clear? What we came with, we are continuing with that only. Right hand is OD cash book. Left hand is OD passbook. Check deposited as per bank statement but not recorded in cash book. What happens to left hand? Passbook balance decreases. So what will you do? Decrease, minus. Clear? Minus. Cash received from X. Person in the question. Person in the question, don't go into flashback. Okay, cash received from X was entered in the bank column of cash book. Cash received from X entered in bank column of cash book. What did you do? What did you do? Unnecessarily you thought of X and did something else. Correct? Cash received, right? Should not have been there only, right? Passbook, they didn't do anything. Cash book, what happens to balance? Decreases, you will increase. Plus, if I have to tell you, this is a bamboo. Why? Because you will see, received from X, you will not focus on cash. Okay, entered in the bank column. You will not focus on cash. You will be like entered in the bank column. So like, okay, and if you receive, you should enter in the bank column. What is the problem? You'll be like, okay, that means here they entered, there they did not enter. And you'll do ulta. Are you getting it? Cash received should not have been there only. In bank column, it is there. Because it is there when it is received, OD balance decreased. Now you reverse it. Clear? Debit side of the bank column casted short. Debit side means what? Receipt side or payment side? Receipt side. Casted short means what? You did not put one receipt. You did not put one receipt. Bank has put that receipt. So bank balance decreases. You also decrease, minus. Check for 9,000. Deposited but collection as per bank statement. Deposited but collection as per bank statement. 8950. What is the mistake here? 50 is not received. So we are focusing only on the 50. Are you getting it? We are focusing only on the 50. Not 9,000 also, not 8950 also. How much did you put? How much did you put? 9,000. So in cash book, how much did you reduce? 9,000. In passbook, how much did you reduce? 8950. In cash book, extra 50 did you reduce? So what should you do? You should add back 50. Did you get this? One more bamboo. Are you getting this? Now see here. 5-mark question. They are throwing bamboos. Correct? Actually, there are some other 10-mark questions which are there in the exam which are too simple. Are you getting this? Okay, but luckily there is one or also here. It was an option question, but this or might not be there in your exam. Oh, yes, you don't do. Yes, they did already in June 2024. Okay, in your exam, they might give it as a compulsory question. Clear? Now, bill sent to bank for collection, collected by the bank, but not recorded in the cash book. Bill sent to bank, collected by bank also. What happened to passbook balance? Decreases. What will you do? You will also decrease. OD. Bank charges recorded twice in the cash book, one extra time in the cash book. That means in cash book, what happens? Decreases. So what will you do? Add back. Oh, charges. Sorry. Minus. Okay. Increase and then it is minus. Okay. Noting charges debited in passbook for bills, discounted bill dishonored. Noting charges debited in passbook means passbook balance increased. So you will also increase. Checks deposited on 25th March but collected by the bank on 5th April. That means not collected. If it is 5th April means for you it's irrelevant over here. Deposited means what happens to cash book balance? Decrease because it is OD. So what will you do? Add it back. Checks issued on 26th March but presented for encashment on 6th April. That means if it is collected on 6th April, it is as good as not collected only. So what happens to cash book balance? Increase. So you will subtract it. Okay, just take your calculator and let's calculate just to see if you're getting positive or negative. 24,000 minus 4,000 plus 3,150 minus 1,000 plus 50 minus 4,200 minus 40 plus 60 plus 4,800 minus 3,000. Are you getting 19,000? Did you get a positive number only? It is, that means this will also be OD as per PB. OD as per passbook. Is it clear? Done June 24. September 24. September 24. Do we have a question from BRS? Yes. How many marks? Only 10. Only 10 marks. Can you see module 1 also has heavy weightage? People are getting the wrong impression that module 2 has heavy weightage. Actually, module 1 also has heavy weightage. Okay. But both modules are important. Now, cash book of Hari showed a debit balance of 1,36,800. Debit balance means what? Normal balance, right? Favorable balance, right? As per cash book, which was in disagreement with the balance as per passbook. Following discrepancies were noticed. Clear? Now listen. Shh. Dividend of now, by the way, guys, normal balance. Money comes very good, goes up. Money goes very bad, goes down. Clear? Remember that. Not OD now. Dividend of 18,000 was deposited in the bank, of which Hari had no information. Left hand is passbook. Balance increased. What will you do? Increase. Now, check was issued to Suresh, 14,780, which was recorded in cash book as 14,870. 14,870 minus 14,780, 90 rupees extra. What did you do? Did you remove 90 rupees more? Did you remove 90 rupees more? Yes. So minus that will get added. Okay. Did you understand this, guys? I should have reduced 14,780 from the cash book. I reduced 14,870 from cash book. So that extra 90 rupees you are going to add back. Checks totaling to 55,000 were deposited into the bank but were not clear. Who entered? Cash book. Add. Then what will you do? Minus. Clear? Next. Mediclaim premium of 14,160 paid as per standing instruction of Hari, which was not recorded in cash book. Passbook decrease. Cash book also decreases. Goods amounting to 1,60,000 were sold to Ajay in November. He deposited check of 15/12/2023 after deducting 4% cash discount. This entry was missed while preparing cash book. Are you using your calculator and calculating 4%? No. They did not enter discount by mistake. They missed the entire entry itself. Okay, so 1,60,000 minus 4%. How much is it? 1,53,600. What did they miss? In the cash book. So 1,53,600 in the cash book. What are you going to do? Add. Clear? I know. Similar structured sentence they had told. They erroneously entered gross amount in the cash bank column. We are not worried about that here. Entire amount only missed, but entire amount is not 1,60,000. Entire amount is not 1,60,000. Entire amount is 1,60,000 minus discount. Are you getting this, guys? Yes. Bank charges for issue of checkbook 150 was skipped while preparing cash book. Bank removed money. You are also going to reduce. Minus. Hari received UPI of 1,000 for sale of scrap, which was not entered in the cash book. Bank balance increased. Your balance also will increase. Checks amounting to 1,80,000 were issued during the month, but checks amounting to 1,44,000 were only presented during the month. That means what is not presented? 36,000 is not presented. So what happened? 36,000 you have already decreased. So you're going to add it back. Just check the totals to see if you're getting positive or negative. How much?
2,76,000.
Positive balance?
Yeah.
Yes, that means it is as per passbook. Not OD balance, normal balance as per passbook. Done. 10 marks. Actually, this 10 mark question was easier than the 5 mark question. Yes. Let's go into Jan 2025. Do we have BRS? Yes, another 10 mark question. Okay. From the following information, prepare a bank reconciliation statement as on June 30th, 2024 for Messrs. XYZ Limited. Messrs. XYZ Limited. Okay. Bank column of cash book was overdrawn to the extent of 24,768. That means you're starting with OD as per cash book. You're starting with what? OD as per cash book. Is it clear? Now, bank column of cash book overdrawn. Right hand is what? Right hand is what? Cash book, OD. Left hand is what? Passbook, OD. When money comes in, balance decreases. Money goes out, balance increases. bank charges amounting to 350 had not been entered in the cash book. Left hand, what happened? Balance increases, you will also add. Clear? Checks amounting to 88,678 issued before June but not presented to bank. That means cash book, what did you do? Balance increases, cash book, checks issued not presented to bank, passbook, cash book increases, OD. Okay, you will reduce. Are you following this? You have to switch between OD and normal. Okay, one payment of 4590 was recorded in the cash book as if there is no bank column only. That means where did they record? In cash column. That means they didn't enter for us. Clear? That means payment of 4590. Bank has entered correctly. Bank balance has increased. So you will also increase. Company paid 15,500 to a creditor and received a cash discount of 2%. Cashier erroneously entered the gross amount in the bank column of the cash book. 15,500 into 2%, that makes it 310. Now, paid or received? Paid. Did you pay extra 310? Did you pay extra 310 in the cash book? Actually, you paid 15,500 minus 2%. Passbook they have recorded correctly. This extra 310 is paid in the cash book. So, cash book balance increases. What will you do? Decrease. Minus only 310. See, we saw first time discount was there in one adjustment, erroneously entered. Then they gave discount also, but they told not entered full amount. Now they are telling again, but first discount which you saw, this discount is not same. It is same but different. Why? Because there it was discount allowed. Here it was discount received. Are you getting my point? There customer gave the check. Here we are giving the check. Now, a debit of 5,700 appeared in the bank statement for an unpaid check, which had been returned marked out of date. The check had been redated by the customer and paid into bank on July 8th. July 8th, who cares? July 8th, who cares? Forget about July 8th. Now here what happened? Debit appeared in the bank statement. That means check bounced. Check bounced. What happens to passbook balance? Increased because it is OD. What will you do in the cash book? You will also increase plus 5,700. Check deposited in the bank but not yet cleared amounted to 45,789. Check deposited. That means what happens to cash book balance? Decreased. What will you do? Add it back. Dividend of 1,980 collected by the bank, not recorded in the cash book. What happens to passbook balance? Decreased. So what will you do? You will also decrease. OD it is. So decrease. Then next, amount of 2340 wrongly credited by the bank to the company account for which no details are available. Wrongly credited by the bank. Bank has reduced the balance. What will you do? You will also reduce the balance. On June 25, 2024, credit side of the bank column of cash book was overcast. Credit side of the bank column means what? Payment side. Payment side overcast. Overcast means what? You have put extra payment. If you have put extra payment, what happens to cash book balance? Increase. Now what will you do? Decrease. Minus. Done. Finished. Just check for safety. If you're getting negative or positive. 18,000. Positive or negative? That means it's normal balance you're telling. You got negative. Huh? Wait. 24,768 plus 350 minus 88,678 plus 4590 minus 310 plus 5,700 plus 45,789 minus 1980 minus 2340 minus 6789. Oh yeah, you're correct. Negative. 18,900. 18,900 when I write over here. Now I will write normal balance as per passbook. If you don't write normal also it's fine. If you write balance as per passbook, that's good enough. Because balance as per passbook means normal. If it's OD, I'll tell you. Clear? Done. Another 10 marks. Jan 2025. May 2025. Is there a BLS question? Yes. 10 marks again. Did they tell you to prepare adjusted cash book? Not once. Oh sir, okay sir. From a very long time they have not asked any question from adjusted cash book. So can we skip it? No. No, that means the chances of that appearing is very, very high. Prepare bank reconciliation statement of Messrs. XYZ Brothers on 31st March 2025. Hello. Good morning. From the particulars given below. Now, bank passbook had a debit balance of 62,500. What does it mean? OD as per passbook. OD as per passbook. What is your right hand, Wasim? Passbook, OD. What is your left hand? Cash book, OD. Clear? Now, check worth 1,000 directly deposited into bank by customer, but no entry was made in cash book. Who made the entry? Passbook. What is your right hand? Passbook. What happens to passbook balance? Reduces. Add it back. You have literally switched all sides now. You started with OD cash book, then we went to normal cash book. Now we came into OD passbook. Okay. Now that's why I told. Like when you do last 4 returns, that time all the transactions would have been covered. After you do the basics, you're not doing this for your preparation. You're doing this for your revision. Okay. Out of checks issued worth rupees 85,000, checks amounting to 50,000 were only were presented for payment. That means how much is not presented? 35,000. That means who passed the entry? Cash book. What is a cash book? This time left hand. What happens? Cash book balance increases. You will also increase plus. Is it clear, guys? Now check for 10,000 received and entered in the cash book, but it was not sent to bank. Okay. 10,000 received and entered in the cash book. Cash book balance is left hand. What happens to balance? Decreases. Here also decrease. Checks worth rupees 50,000 had been sent to bank for collection, but the collection was reported by the bank as under. Bamboo. Very important bamboo, which actually I say is treated in a little different way. Okay, which is not completely right. Now, checks collected before 31st March 2025. What does it mean? When did we send the checks? Had been sent to bank for collection, but collection was reported by the bank 31st March, before 31st March. Good. Correct. This is what I say is approaches. Good. Checks collected on 10th April. Bad. Because it has gone into next year. Checks collected on 12th April. Bad. That means it's gone into next year. 15,000 is not collected. Correct. Now tell me one thing. What is the treatment? Cash book fully have recorded. 50,000 recorded. Which hand is your cash book? Left hand. That means collected. What happens to cash book balance? Decrease. What will you do? Decrease. But decrease for what? 15,000. Clear? Next. Bank made a direct payment of 1,500, which was not recorded in the cash book. Right hand is bank. What happens to the bank balance? Increase. So what will you do? Decrease. Are you following this, guys? Interest on OD charged by the bank 4,000 was not recorded in the cash book. What is right hand? Passbook. What happens to passbook balance? Increase. Decrease. So decrease it. Right hand is moving. Bank charges worth 200 have been entered twice in the book, whereas insurance charges of 175 directly paid by bank was not recorded in the cash book at all. One you have entered double, one you have not entered. Left hand is cash book. Okay, one which you have entered double. What happens to the bank charges which has entered double? Increase in the cash book. You will also add it. So 200 will be added. 175 what will happen? Not entered. That means passbook they have entered. Passbook balance increases. Now you have to decrease. Right hand has moved. Credit side of the bank column of cash book was undercast. Credit side means what? Payment side. Payment side undercast means what? They haven't put a payment. They haven't recorded a payment. So now bank has recorded that payment. So bank balance increases, OD balance, and here you have to decrease it. Just check if you're getting positive or negative. Oh, one more is there. Wait. Oh, just because you saw 9. Oh no, sometimes ICS is also gracious. You think what? They're always rude? No, they're nice people. Some of you only, no? Positive or negative? Positive. 1 lakh 025. 025. Yes, that means it is OD as per cash book. Done. BRS done. Done, done, or done. Is this clear? Can we go further? Let's continue, guys. depreciation and amortization. Depreciation and amortization. Regular people, for you, like half of depreciation not done, right? Oh, you already saw. Okay. Depreciation, amortization, very beautiful car is sitting over here. Okay, now we might not be able to solve all problems before lunch break for depreciation, but we'll see till where we can go. Depreciation has some amazing problems. Some amazing problems. Not in the illustrations. Illustrations are all stupid. Go to practical question and see question number 1. It will blow your mind. You know why it will blow your mind? Because ICS showed no calculation at all. No calculation, direct full amounts. From where it came, how it came, we don't know. That question is must to do. Must to do. You have to do it. Now, go into your final revision. Now write depreciation. Obviously, first you are going to do the concept. You're going to do the concept. Then I'll tell you what to do. Depreciation. Okay, write these questions. Okay, depreciation after the concept. SM10. SM10 you have to do. Then SMPQ1. Practice question 1. Then June 2022. June 2022. 10A. 2A. Clear? Then June 2023. June 2023 again 2A. Question 2A. That's it. Then last 4 attempts. These many things you have to cover in depreciation. Okay. This is for last minute revision. Please don't study only these questions and go to the exam. Okay. This is for last minute revision. I have to give disclaimer. Because in YouTube, no, always somebody will be there who will put message telling that, sir, only this much is enough. Yes, it's enough for revision. Clear? Now, let's continue, guys. Let's start with the concept. Beautiful ambassador car is there. Depreciation and amortization. Let's begin. Yes. Okay, guys. What is depreciation? Reduction in value of tangible asset. What is amortization? Reduction in value of intangible asset. That's it. Okay, both are reduction only. When it is reduction in value of any asset, it has to be a loss. So both depreciation as well as amortization will be treated as expense or a loss. Clear? Are you following this? Causes of depreciation. Wear and tear. What does wear and tear mean? Beautiful car. Imagine now, there one guy is sitting, okay. Here, Praveen. Where is Manju? Manju, there, last one guy is sitting. His parents, they decided that they'll give him one new bike. Assume it as bike. Listen, they gave him one new bike. Now tell me one thing. The causes of depreciation. Wherever he saw hump, right, he used the accelerator, not the brake. He wanted to see how high it will jump, like the Telugu movies. Correct? Wear and tear. Wear and tear. Now he is not doing all that circus. He is parking the bike in his house, coming by metro. But every day he will clean his bike and keep once. Clear? Still the value will go down passage of time. Correct? Technological changes. Bike is beautiful. Technology. Clear? Suddenly they said anymore, only one day in the week you can use this bike. Other than that, all the days we should use only EV on the road. Government. Now what happens? If you can use some asset only one day of the week, the value of that will fall down. So these are the causes for depreciation. Is it clear? Yes. Why should depreciation be charged in the books? Conservatism. That's actually the main reason. The main reason for depreciation is you save money so that in future you can buy a new asset. Now, accurate financial position. Accurate financial position. Your bike value in the market is 2 rupees. But in the books you are showing 2 lakhs. Does it make sense? No, you have to depreciate and show the correct financial position. Balance sheet is something. When I look at it, no, and take the asset into the market, I should get similar value at least. Otherwise, you are showing completely wrong position of the business. Now, compute accurate profit. Accurate profit. To calculate profit, to earn profit, you have used machinery. So part of the machinery should also be taken as expense. So that is one of the reasons. Government regulation. I don't know anything. Government is telling, I'm following it. Nirmala Aunty. Okay. Companies Act. Income Tax Act. Nirmala Aunty is telling depreciation, you take it. Okay. In this thing, income tax, I'm very happy. I'm following what Nirmala Aunty is telling, because if I take depreciation, my income will come down. Okay. But Companies Act, I'm feeling very bad. If I put depreciation, my profit will go down. I want to show more profit so that share price will boost in the market. Okay. So anyways, government regulations to compute correct cost of manufacture. Remember remember there is one thing called as manufacturing account. Okay, it will come in the future. In manufacturing account, if there is depreciation on machinery, you put it into manufacturing account. If it is depreciation on factory building, you put it into manufacturing account. Why? Because those things were also used for manufacture only. So when you are computing the cost of manufacture, you can't ignore it. Therefore, the correct cost of manufacture, if you want to compute, you have to charge depreciation. Last, to save money to buy a new asset. Most important reason is this only actually. To save money to buy a new asset is the reason why depreciation is a non-cash expense. When you have a non-cash expense, now understand this. This is my P&L and this is my bank account. This is my bank account. Clear? Both of them actually do not have direct connection. They have indirect connection. Imagine I have profit over here. Profit over here, 100 rupees. Clear? Let's assume till now in this profit, everything is cash. Everything is cash profit. So goes to bank, 100 rupees there in the bank now. 100 rupees. Everything is received, 100 rupees there in the bank. Depreciation, if I don't put, how much profit will remain? Net profit will be 100. Where will this net profit go? It will go to balance sheet. If it goes to balance sheet, who will have the right to grab it? Owner. If I put it to balance sheet to capital account, owner can just take it off. But if I write depreciation over here, 20. But from the bank, 20 will not go because it's a non-cash expense. So now here net profit will be how much? 80. What will go to the owner? 80. How much can owner take? 80. If owner takes 80, automatically can you see 20 saved in the bank account? Clear? This is to save money to buy a new asset. This is one of the reasons. Clear? After 5 years, 10 years, I should not be in a position that I have to arrange money again. So I arrange little by little, so that some amount at least is saved. Okay guys, let's go further. Shh. One whistle done. 2 more whistles, then only a lunch break. Okay, guys, they just kept. Methods to compute depreciation. Methods to compute depreciation. There are many methods. Now, what is the difference between method of computation and method of accounting? Method of computation is finding the value of your depreciation. Method of accounting is you know the value, how to pass the entries. Clear? Now, straight line method, also called as fixed installment method, or also called as original cost method. All same and same. Clear? Now, depreciation is given by this formula. Cost minus scrap value, which is residual value. What is scrap value? Estimated amount receivable at the end of useful life. Complete bakwas. Complete bakwas. Estimated value at the end of the useful life. 10 years later, I'm telling somebody will buy it for 5,000. Okay. After 4 years only met with an accident and it's gone into Gujri. 10 years later, who will give you now? Are you getting my point? So in depreciation, only thing that is accurate is cost. Only thing that is accurate is cost because that went from your pocket. Okay. Amount spent to acquire the asset. This is estimate. Number of useful life, huge estimate. Number of years expected to be used. Listen, shh. This bike, okay, this bike only it is. Okay, this bike. Manju's parents, okay, they said that Manju is a nice boy. Okay, they thought that. Okay, they thought that Manju is a nice boy, and they had decided that useful life is 10 years. They thought that useful life will be 10 years. But this fellow, every day in front of girls' college, he is doing full wheeling. Full wheeling he is doing. One wheel only. Correct? Because of that, listen. Shh. Because of that, in 2 years, his bike is gone. Correct? Now, did you understand this? Useful life is a huge estimate. This is also expected. This is also estimated. Are you following this? Yes. But what is the formula again? Cost minus scrap value divided by useful life. Guess what? All three will be given in the question. You are doing what? Fill in the blanks and getting the answer. Clear? Now, certain things you have to remember. If at all they don't give you all these values and they tell you depreciation 10% SLM or they tell 10% on OC, original cost, both are same, but you can't use that formula now. What will you do? Every year you will do original cost into depreciation rate. Are you getting this? Very important. Every year you will do original cost into depreciation rate. Guys, good morning. I don't care about your lunch times. Okay, if you are not listening, I will continue class. I don't care, I am going to continue. So if you are listening only, I will leave you at 12:30. Clear? Otherwise, just like ICA gives bamboo, even I will give bamboo. Huh? Yes, focus. Now, why I am telling you focus is because I know you will make mistake here only. You feel that SLM is simple. But they will give question like this, 10% SLM on OC, original cost, or 10% just SLM method. And you will be calculating depreciation for the third year. When you calculate depreciation for the third year also, you will still take original cost into depreciation rate. Are you getting this? Original cost into depreciation rate. Example, you see. Cost is 1 lakh. Salvage value 25,000. Useful life is 10 years. Cost minus scrap value divided by useful life 7,500 per year. Shouldn't be a problem. Clear? Beautiful, no houses. Plane is about to crash into the house. But still house will not fall. Indian technology. You guys are blaming, but you don't know Indian technology very good. House will not fall. One small hostel did not fall when the plane crashed. Plane was sitting on top of it. But big building fell. When one plane crashed. Moral of the story is not about big building and small building. If you want the building to fall, it will fall. Correct? Do you know these two big buildings? What is it? WPL. WTO. World Trade Organization. WTCO. What is WTO? World Trade Organization only. Some people are thinking WPL. Women's Premier League. Yes. Wasim, every time it's not about WPL, guys. Yes. Do you know who won WPL this time? Huh? MI. Do you know who won IPL this time? See, you didn't get that answer quickly. WPL Rappa told MI. When I asked who won IPL, you shows where your interests are. Okay, guys. Written down value method is also called as fixed installment method. Now listen. Shh. Written down value method, first year will be cost into depreciation rate. First year. But after that, it will be WDV into depreciation rate. WDV is what? Written down value. What is written down value? Written down value is, it's here, cost minus depreciation till previous year. So remove the depreciation till previous year, that is your WDV, on that you apply the depreciation. From second year onwards, this is going to be the treatment. Are you following this? Anybody has any doubts with this? No. Now tell me one thing. If I follow WDV method in our books, do we have WDV? Yes. Correct. If I follow SLM, don't write SLM method. It's in that method is there already. SLM. Okay, in our books, we are following SLM, right? In our books, do we have WDV? Do we have WDV? Yes. There is every method, WDV is there. Every method, don't go by my expressions, okay? You have to go by your concept. Don't see my expression and give the answer. Okay? In SLM also, WDV is there. Any method you follow, WDV is there. You know what is WDV? That balance brought down, balance carried down, you will write every year. That is WDV. If you are following straight line method, that balance will be there. I will use some other thing to calculate. If you are following WDV method, then you will use that only to calculate your depreciation. Are you getting this? Yes. Okay. Example you see. Cost is 1 lakh. Depreciation rate 10%. First year what will you do? Now see, I have given the illustration for both, okay, so that you understand. If at all they would tell this in the question 10% WDV, or if they would tell 10% SLM, what would you do? Here in SLM you see, every year you are actually doing 1 lakh into 10%. That means cost into 10%, cost into 10%, cost into 10%. And your final balance after 3 years will be 70,000. But if you are following WDV method, first year you will remove 10%, you will get 90,000. On 90,000 you are going to calculate 10%, and on 81,000 you are going to calculate 10%. Here you see again, on this 10%, on this 10%, and on this 10%. Are you getting this? Is this clear? Any doubts with this? No. Okay, they will give a question for you. Actually, this is a very small part. There's a very small part. Calculating depreciation, very small part of depreciation questions. Accounting is the bigger part. Clear? Next. Sum of digits method. It is there also, not there also. Okay. They don't use it at all in India, but still it's there in your syllabus. Okay. Sum of digits method. What is the formula? Number of years remaining divided by sum of digits of useful life, cost minus scrap value. How to get sum of digits? N into n plus 1 divided by 2. We can use math. Otherwise also you can calculate. Imagine I tell you 5 years useful life. I can do 5 plus 4 plus 3 plus 2 plus 1. Instead of that, I can just do n into n plus 1 divided by 2. That is 5 into 6 divided by 2, which will give me 15. Clear? Now, cost minus scrap value, you know, it will be given in the question only. Number of years remaining means what? Now imagine I am in the 5th year. I am in the 5th year and useful life is 5 years. How many years are remaining? How many years are remaining? How many years are remaining? 1. It is not 0. If you take it as 0, last year no depreciation, because 0 divided by anything will be 0 only. Clear? Now, number of years remaining, whatever is in red is important. Okay, number of years remaining is including current year. So now tell me, 5 years useful life. We are in 3rd year. How many years are remaining? 3rd, 4th and 5th. Clear? 3 years. Imagine we are having useful life of 10 years. We are in 7th year. How many years remaining? 4, 7, 8, 9, 10. That's how you're going to calculate if it is sum of digits method. Clear? Now, example. Cost is 1 lakh. Useful life is 5 years. Scrap value is 10,000. Scrap value is 10,000. First year, what will you do? First year, how many years you are having remaining? Full 5 years are remaining. 5 divided by 15. Sir, how did you get this 15? 5 plus 4 plus 3 plus 2 plus 1, or 5 into 6 divided by 2, which is also 15. Clear? N into n plus 1 divided by 2. Small tool in math which you use many times. Okay, into cost minus scrap value. 1 lakh minus 10,000. Now you are like, sir, why should you do cost minus scrap value? Why should you do cost minus scrap value? Yeah, you will get the 10,000 remaining, yes. But why should you do cost minus scrap value? Because what is going to depreciate in this asset is only 90,000. Because at the end of the useful life, you will get the 10,000 back, no. So asset is only going to depreciate for 90,000. That is why the formula has inculcated that cost minus scrap value over there. Are you getting this? You're feeling cold. Yeah, I'm also feeling hot. No, that class is better, I feel, no? Everybody's fine with going to that class? We'll check with them. 4 by 15. Why 4 by 15? We are in the second year. Second, third, fourth, fifth. Then 3 by 15. Third year, third, fourth, fifth. 2 by 15. Fourth year, fourth and fifth. Last year, 1 by 15. Clear? Everything else remains same. Can you see? Everything else remains same. Are you following this, guys? Yes. Very, very important. In this only 5, 4, 3, 2, 1 will change. Denominator is same. Multiplier is same. Only thing changing is numerator in the formula. Now, a lot of people skip sum of digits method thinking that it's not asked for a very long time. Yes, surely it is not asked for a very long time. That means it can be asked. Machine hours method. Machine hours method, production units method and depletion method, they are cousins. Okay, they are cousins. Okay, very similar to each other. Machine hours method, that means what? How many hours I am going to use, that much the asset depreciates. So, hours used divided by total hours into cost minus scrap value. Clear? Production units method means what? How many units I manufacture, that much it will depreciate. So, number of units produced divided by total units into cost minus scrap value. Imagine the ultimate, analysis. How can you predict total hours, how much you are going to use? Some machines come with expiry, not in years, in hours. They're like, as soon as you use 50 hours, it will shut down. Like for example, imagine you have the access in your app, no, for the classes. Now it's time based. It is time based, but there are other academies, no, who will provide based on views. So it's like if it is 2 views, as soon as you finish 2 views, it will stop, right? So now is it time based? Is it time based here? No. Imagine in 2 days you watched and finished 2 views. That means over, no. So that means total hours also can be used for depreciation. And number of units. There are some machines which as soon as you get 100 units out of it, machine stops. Clear? So here how many ever units you produce divided by total units into cost minus scrap value. Clear? Depletion method. What is depletion method? Usually used for land and all. You are going to extract things from the land. Okay, when you are going to extract things from the land, quantity extracted divided by total quantity into cost minus scrap value. Are you following this, guys? Yes. Methods of accounting. This is the crucial part, right? Methods of accounting. 5 minutes. Over, no, done. 12:30 anyways we are going to go. Methods of accounting. First method. Depreciation is reduced from the cost of the asset itself. Second method. Provision for depreciation is created. We'll discuss the first method and take a break. Then we'll come back and discuss the second method. Okay, this one is important. Important because you are very used to this one. In school and all, you would have been doing the method one more often. No, you're doing the second method only. Both methods are not there. You are from Karnataka then. That's why you're calling it college. But there are these Tamil Nadu people who will call it school. That's why I'm also confused whether to tell PUC or whether to tell 11th and 12th. Okay, now, method 1. It is reduced from the cost of the asset. Clear? When you purchase asset purchase entry, does it have anything to do with depreciation? Does it have anything to do with depreciation chapter, asset purchase entry? No. So when you purchase asset, entry is always asset account debited to bank, assuming that you made the payment. Otherwise, it would have been to party who you did not make the payment to. Depreciation every year end. What will you do? Depreciation account debited. Why? Because it is an expense to asset account. Why? Asset decreases. Depreciation means reduction in the value of asset only, no? So asset reduces. Clear? Sale of asset. Whenever sale of asset happens, you have to be a little careful. Okay? Now understand this. When you sell the asset, first what you should do, not record the money. When you sell the asset, first what you should do, compute depreciation till the date of sale. It is not necessary that they'll sell the asset at the starting of the year or ending of the year, right? They'll sell it somewhere in the middle of the year. So compute depreciation till the date of sale. Why? Because the asset is used till that day. That means asset has depreciated till that day. So depreciation account debited to asset account. Repeat telecast of the entry what we already discussed. Okay, now here remember months. Don't directly apply the percentage. Remember months. Sale entry. When you sell, what will you get? Money. Bank account debited because asset increases. Asset account debited because one more asset decreases. Asset account credited because one more asset decreases. Is it clear till here? Now, just giving thumbs up to some doubts. Okay, profit or loss? Students, you can't be asking too many doubts on marathon, okay? These regular class students, still yesterday you were in regular class. You can't come and ask doubts in marathon. Okay, you have my number, you can ask doubts there. But marathon, we can't clear too many doubts. Maybe after class you can stay back, I can clear doubts, but not during the duration. Okay, but if you have some topic you want me to explain, that I can do. Okay, profit or loss, sale value greater than WDV on the date of sale. Sale value is greater than WDV on the date of sale. Now you know what? How did you get this WDV on the date of sale? After you charge this depreciation till the date of sale. Otherwise you only have opening balance. Balance is at the starting of the year. Sale has happened over here. So to bring the balance till here, you have to charge depreciation. Now you have the balance over here. So balance on the date of sale when you get, compare it. If you get more money, good or bad? Good, right? P&L should be credited, asset account should be debited. Remove from asset account because when you got the money, right, entire amount you put to asset account. Entire amount has been credited to asset account. You should have put only the differential part, but you put an entire amount because you are preparing ledgers. So directly you'll write over here by bank. Then you'll remove the profit and transfer it to P&L. Is it clear? So if there is profit on the date of sale, what will you do? Asset account debited to P&L. If it is loss, how can you incur a loss? Amount received is less, WDV is more. So P&L has to be debited, asset has to be credited for the loss on sale. Is it clear? This is the first method, that is depreciation is reduced from the asset value. Second method is also interesting, but we'll do it after the break. Take a break, come back at 1:30. Okay, welcome back. We'll go into method 2 now. Method 2 of provision for depreciation. Okay, method 2 is for provision for depreciation. Okay, very important method. A lot of errors are happening over here itself. First method is like very simple. Now, asset purchased entry. Is it going to be different? Whether you purchase asset under method 1 or if it's method 2, method is not for recording how you purchase the asset. Method is for recording how you pass the depreciation entries. Is that right? So the entry will be asset account debited to bank account. Same entry, asset account debited to bank account. Now depreciation every year end. If the depreciation is there every year end, what are you going to do? Depreciation account debited. What did you do earlier? Depreciation account debited to asset account. Depreciation is still debited because depreciation is an expense. It has to be debited. But instead of reducing the asset, you are going to write provision for depreciation account. Provision for depreciation. So if I have an asset, okay, I have a balance sheet and I'm showing the asset under method 1, method 2. If it is method 1, if it is method 2. In method 1, first year it will be 100. In method 2 also the asset will be showing 100. But after that what will happen in method 1? Directly this will become, if it is 10% depreciation, it will become 90. But here it will remain 100 only. It will remain 100 only. But what we will do? One provision for depreciation gets created on the opposite side. Provision is a liability. It gets created on the opposite side. But for better presentation, what we will do? We'll bring it to the asset side. We'll bring it to the asset side and we will write minus. And this becomes 90. Clear? Net effect is same. This is what is going to happen every time. Okay. Only thing is now all times we can get to know what was the cost of the asset. But under method 1, we will never know the cost of the asset. After 2-3 years, we will be only seeing the WDV. Is it clear? Now, what is the entry for depreciation under method 2? Depreciation account debited to provision for depreciation. Now, sale of asset. Same logic again and again, over and over again. When you sell the asset, compute depreciation till the date of sale. Then, depreciation account debited to provision for depreciation. Debit to P&L. What will you debit to P&L? Depreciation will always be debited to P&L because it's an expense. Disposal of asset. Now, whenever you have provision for depreciation, right? When you sell an asset, you make another ledger. The other ledger is called as disposal account, asset disposal account or disposal of asset account or just like that you can call it as disposal account. Now disposal account, what is going to happen? Transfer of cost of the asset to disposal account. Transfer what? Cost of the asset you remove from asset account and put it to disposal account. To remove the asset, what should we do? Asset has to be debited or asset has to be credited. Asset has to be credited. So disposal account will be debited. Clear? When you transfer the cost itself, do you require the provision for depreciation? No. Remove the provision also and transfer it to disposal account. Provision for depreciation account debited to disposal account. Now, provision was a liability. When liability reduces, it is debited. Clear? Now, when asset and provision both are sitting in disposal account, why do we require, where do we put the money? Money also will put it to disposal account, bank account debited to disposal account, and ultimately from here only, profit or loss will be transferred to P&L. From here, what are you going to do? Profit or loss will transfer to P&L. Now, profit or loss, if sale value is greater than WDV on the date of sale, what will you do? Profit. Where will you remove the profit from? Disposal account debited to P&L. If it is less than WD, that means it is loss. P&L account debited to disposal account. Is this clear? Are you following this? Very important method. Okay. Very important method. How you are going to treat the disposal of asset plays a crucial role in whether you are going to score the full marks or not. Now, tell me one thing. If they don't tell you also, should we open disposal account? They just told that asset account and provision for depreciation account. Without opening disposal account also, you can still do it. But it is better to open disposal account so that you have complete clarity. So, simple logic. If it is method 2, asset is always at cost and all the stored depreciation will be in provision for depreciation. Clear? So, when an asset is sold, what will you do? First thing, calculate depreciation till the date of sale. Then what you do? Take the total cost. Total cost of what? Only the asset which is sold. Take the cost of the asset which is sold, put it to disposal account. Take the provision for depreciation which has been accumulated over a period of all these years, take it and put it to disposal account. After that, what are you going to do? Compute the profit or loss. But to compute profit or loss, you are going to receive amount. Amount received also will be put it to disposal account. Ultimately, the balancing figure, that is, if the sale value is higher, profit, sale value is lower, loss. You are going to compare higher and lower, comparing it with what? The WDV on the date of sale. Clear? How you calculated profit or loss is the same how you calculated in method 1. Is it clear? Now, next, another depreciated asset. Now, depreciation. Now, understand this. If you understand this chart, it will give you more clarity. This is the start of the year. This is when asset is purchased. This is when asset is sold. And this is the end of the year. Clear? Now, from where to where we have to calculate depreciation. If the asset is sold, you will calculate depreciation from starting of the year till the date of sale. Correct? So, depreciation on asset sold will be till the date of sale. But if it is asset is purchased, you will calculate depreciation from date of purchase till the end of the year. When asset is there from starting till ending, depreciation for the entire year. Clear? You know why I have given this? Because whenever there is purchase, whenever there is sale, purchase wala depreciation simple. Sale wala depreciation simple. What is ultimate target or ultimate bamboo at the end is calculating depreciation on the assets which are unsold. From that you have to remove the asset which is sold. Then you have to calculate depreciation. Is it clear? So if something is sold, till it is sold, calculate depreciation. If something is purchased, from the date of purchase, calculate depreciation. Something is not sold, not purchased. That means it is coming from previous year. Entire year, calculate depreciation. Is it clear? Are you following this, guys? Yes. Now, computation of depreciation on asset unsold at the end of the year. Whatever asset is unsold at the end of the year, you can follow this format. You can use logic also. But otherwise, you can take total WDV at the beginning of the year. Total WDV at the beginning of the year. Not at the middle of the year, end of the year, nothing. At the beginning of the year. From that, remove the WDV of the asset sold at the beginning of the year. Asset is sold somewhere during the year, but remove the WDV which was there at the starting. That time you will get WDV of asset unsold. Simple, apply the depreciation rate or whatever is there. That time you will get the depreciation. Is it clear, guys? Now, asset might be sold on 1st October. We are not worried about 1st October. Asset might be sold on 1st October. But I am telling, take the WDV on 1st April of all the assets. From that, remove the WDV of the asset sold on 1st April. Now what will you get? Balancing figure is asset which is unsold. Asset which is unsold is there for the entire year. So you calculate depreciation for the entire year. So I'm like, now you're like, sir, what about the asset which is purchased? It is not there at the starting of the year, no. Starting of the year, you can have only two types of assets. One, asset which has remained in the entire year. Two, asset which has been sold during the year. Asset which is purchased was not there at the starting of the year. Where did it come? It came somewhere over here only. Asset purchased. This is a very important timeline. Are you getting this? So asset which is there at the starting, either it is sold or it lasted till the end of the year. Okay, so from this, if you remove this, you will get all the assets which are unsold. That time you can easily calculate depreciation. Is it clear, guys? Yes. Now, change in method of depreciation. What is there? If there is change in method of depreciation, is there any circus to be done? Simple. When did they change? Today. Till today calculate under old method. From tomorrow calculate under new method. Till today calculate under old method. From tomorrow you apply the new method, whichever the new method is there. Now compute WDV till the date of change under old method. Compute WDV till the date of change under old method. Whether it is SLM, WDV, whichever method you are following. Till the date of change, calculate the value. After that, what you are going to do? Compute depreciation using the new method. Okay. So retrospective effect not applicable. What is retrospective effect? Are we going to give effect from beginning of time? No. Earlier they should do that. But now they don't do it. Okay. Only from the date of change. That is prospective effect. Prospective effect means what? Only from the date of change we are giving the effect. Follow new method from the date of change. Are you clear with this? Any of this can be asked. Now revaluation. Okay, let's go into revaluation. Asset is of 100. Revalued to 120. What happens? Asset value increased or asset value decreased? Increased. Asset account debited. The profit where will you put? Will you put it to P&L? No, where will you put it? Revaluation? Yes, wrong. Revaluation reserve account. Revaluation account is prepared in partnership. When there is an admission, retirement, death there. Are you getting my point? There is no revaluation account over here. It is called as revaluation reserve account. Revaluation reserve account. Now, revaluation account, it won't remain. Revaluation account will be created and it will be just distributed to partners. Correct? Revaluation reserve will remain from year after year. Now, understand this. If they ask this question, 100% it is going to be a bouncer because many of them would have not studied only revaluation. Simple. Asset increase. Think from asset angle. Forget about the other part. Asset increases. What will happen? Asset account debited to revaluation reserve account. Clear? Asset decreases. Asset has to be debited. Sorry, asset has to be credited. Can you debit revaluation reserve? No, because revaluation reserve only is not there. Money that is not there, profit that is not created. Can you debit that? No. So here you are going to debit P&L account. Okay, now imagine this situation continues. This situation continues. Few years later, the same asset which you increase the value, right? The asset value has decreased. So if future asset is revalued from 120 to 70. Now what will you do? Asset value has gone down. Now do you have revaluation reserve? How much? Only 20. So how much is there in revaluation reserve? Take it from there. Whatever isn't there in revaluation reserve, what will you do? Debit it to P&L. So revaluation reserve account debited, P&L account debited to asset. Is it clear, guys? Now, in future, if asset is revalued from 70 to 110, first what happened? Asset got revalued downwards. After that, if you are going to revalue the asset upwards, when you revalue the asset upwards, what are you going to get? Profit or loss? Profit. Where will you put that profit? Revaluation reserve. But earlier you had a loss. Earlier you had a loss. Compensate that loss. Put that loss back. P&L debited. Sorry, to P&L. Then extra profit you put it to revaluation reserve. Are you getting this? Simple. Now if I have to brief this up. First time your asset is going upwards. Where will you put the profit? Revaluation reserve. First time your asset is going downwards. Where will you put the loss? P&L account. First time your asset is going upwards. Okay, you have already credited the profit to revaluation reserve. That same asset subsequently it is going downwards. Then what will you do? Loss. How much is possible? Take it from revaluation reserve. If you have extra loss, debit it to P&L. Debit it to P&L. When the asset has gone down, there was a loss. Subsequently, if that asset goes upwards, profit, how much profit you made, first you compensate that old loss, put it back to P&L. If you made extra profit, that will go to revaluation reserve. Is it clear? So whenever there is a subsequent change, both of these are subsequent changes. So here what you are going to do, extra loss debited to P&L, here extra profit credited to revaluation reserve. Simple logic, where you have put the profit, remove it first, then you remove it from P&L. If you have removed from P&L, first put it back to P&L, then you put it to revaluation reserve. Are you following this, guys? Yes, that's it. What happened? I'll share the entire material, man. Huh? Okay. Okay, guys, can we continue? Sir, do we have quant class also, sir? You have only quant class today. There is no also. It is quant only today. This is marathon which is going on. This is not regular class. Okay, you only have quant class today. Your accounts class will continue on Monday. Okay, guys, done? Can we continue? Done. Have you written already how much you have to solve? SM10, SMPQ1, June 2022 2A, June 2023 2A, and last 4 attempts. All these you have to see for depreciation. Maybe in some of the attempts, maybe depreciation nothing is asked, so we can ignore that. Now, let's go into SM. Study mat, study mat, study mat. Yes. What happened? This is the question I was talking about, SM10. Anshul, yes. Clear, guys? Now, why is this question important? Because this has change in method of depreciation, SM10. Okay? Now, listen. Every question of depreciation which we are going to pick is important. It is covering some or the other concept. Mr. Anshul and co. First, you will always go to the end of the question. Go to the end of the question. Calculate the difference in depreciation to be adjusted in plant and equipment account for the year ended. Basically, ultimately, they are telling you prepare plant and equipment account. That's all. Too much circus and all they have told, but ultimately, you are going to prepare plant and equipment account. Now, Anshul and co. commenced business on what date? 1st January 2017. Let them commence business whenever they want. We are worried about when did they purchase assets. Clear? Now, when they purchased plant and machinery equipment for 7 lakhs, that day only they purchased. First day, instead of enjoying their business, they purchased one big plant and equipment of 7 lakhs. Till now, we don't know what we are going to do. Okay, here we are talking about which year? Year ended 31st December 2021. Just because they purchased something in 2017, don't sit and do everything from 2017. We are doing everything only in 2021. Only for 1 year. Is it clear? Now, they adopted a policy of charging depreciation at 15% per annum on diminishing balance basis. That means which method is this? WD. And over the years, their purchase of plant has been 1/1/2018 they have purchased. First of all, 1/1/2017 they purchased 7 lakhs. One more 1/1/2018 1 lakh 50. 1/1/2021 2 lakhs. Do we have 3 assets now?
Yes.
Yes. On 1/1/2021 it was decided to change the method and rate of depreciation to straight line basis. On this date, remaining useful life was assessed as 6 years for all the assets purchased before 1/1/2021 and with no scrap value, 10 years for the assets purchased on 1/1/2021. Now, from which method to which method we are switching? WDV to SLM. When we are switching to SLM, we need useful life. Correct? So they told whatever assets are there before 1/1/2021, take the useful life as 6 years. Take the useful life as 6 years. Clear? Whatever asset is purchased on or after 1/1/2021, take the useful life as 10 years. For this, you are going to take the useful life as 10 years. Is it clear? So now, first of all, to start the ledger, you need balance brought down. This only we don't know. 7 lakhs was 1/1/2017. Once upon a time. Are you getting my point? We need what? 1/1/2021. So what you will do? Take the asset which is purchased on 1/1/2017. Working note. Yes. Okay. Cost. Depreciation for 17 you remove. At what rate? 15%. That time you will get the WDV. Then remove depreciation for 2018 at the rate of 15%. This is for 2018. Okay. Then depreciation for 2019. Correct. Then depreciation for 2020. 4 years if you are removing depreciation you will get. And even 2021. But 2021 is under different. Let's calculate only till here. Okay. This is till here we have followed WDV. From here we have followed SLM. Is it clear? Are you following this? Now, understand this. You can just plainly take your calculator, punch the number 7 lakhs. Okay, 7 lakhs minus 15% first year, minus 15% second year, minus 15% third year, minus 15% fourth year. Are you getting 365,404? That is the WDV. That is the WDV of one asset. What about the second asset? 2018 wala. First year, this will be blank because it was not there only in 2017. This was purchased in 2018. So 2018 depreciation minus 15%. Then 2019 depreciation minus 15%. And 2020 depreciation minus 15%. You're getting 92,119. Are you getting 92,119? These are the two assets. Why are we ignoring the third asset? Because that came in 2021. We are calculating only till 2020. Because if you see, on 1/1/2021 method changed. 1/1/2021 method changed. So till end of 2020, I have to calculate under old method. Clear? When I'm calculating under old method, what am I doing over here? Can you see these two assets are there? That value is how much? That is the third one, right? Okay. So calculate this 365,404 plus 92,119. Are you getting 457,523? Can you see that 457,523 sitting over here? That is the balance brought down. That is the balance brought down. Here your 2021 starts. In 2021, what did you do? First circus. You purchased one new asset at the starting of the year itself. Okay, 2 lakhs. So what are you going to do? You are going to write 2 bank account, machinery account or plant account or equipment account debited to bank account, 2 lakhs. Is this clear till here? Now what? This asset, how many years depreciation now? 6 years. This asset, how many years? 6 years. So 457, 523. Is there any scrap value? 0 divided by 6 years. So 457, 523 divided by 6. Are you getting 76,254? 76,254. That is the depreciation. Okay. If you total this, you will get 76,253 or 54. They have taken it as 53. Okay. Because it is 0.83, I made it 54. Clear? Now, what about this new asset which is purchased? 2 lakhs divided by 10, because they said useful life is 10 divided by 10. Can you see the 20,000 depreciation sitting over here? This is just balance carried down, done, finished. Balance carried down. You know what was the method earlier on? Earlier on means just some 2-3 years back. No. Earlier on, it was like if at all you change the method today, you have to calculate under old method. Then you have to calculate under new method from starting. And then you compare the difference and do it. They said they felt it is not logical. Okay, so they changed it. Before they should treat it as change in accounting policy. Now they treat it as change in accounting estimate. Because entire depreciation is estimate itself. So did you understand what we did over here? This is till 2020. Till 2020, what did we do? Calculate depreciation under old method. When we calculate depreciation under old method, you will get to know the WDV on the date of change. For that WDV, you apply the new method. Now, look at the revision again. Change in method of depreciation. Compute WDV till the date of change under old method. Did we do that till 2020? Till 2020 end, did we use the old method and calculate the WDV? Then compute depreciation using the new method. 2021, did you calculate under SLM? This is what you're supposed to do. Is it clear? So they can ask questions from this as well. Okay. So if you have any doubt, let me know. I'm keeping it open for 30 seconds. Is there any doubt? Did you understand it? Every question is important. Yes. Which one? Nothing, man. This divided by 6. This divided by 6. I took total. Yeah, following straight line method. I took total and divided by 6. They are doing asset wise. See, 365,404 divided by 6. You'll get, 60,900. Done. Any doubts? Yes. Shall we go further? Okay. Now, what is the next question you are supposed to solve? Practical question. Provision for with provision for depreciation, SM practical question number 1. Very simple question. Okay, very, very simple. ICA has solved it like nothing is there. But we didn't understand also anything from that question. Okay, let's see how it goes. Practical question number 1. Problem is what, there are some key areas which you need to know. This is the one, right? See. From there we cannot understand anything actually. You have tried it already, right? Yes. But it's important. Okay, now focus. Focus fully. A firm's plant and machinery account as at 31st December 2021. Hello, madam. Hear you. Okay, and the corresponding depreciation provision account broken down year by year of purchase are as follows. Clear? Year by year they have given. 2005 they have purchased something. Cost of that was 2 lakhs. Depreciation provision is 2 lakh. What does it mean? Nil value. No depreciation. No. Pura depreciation ho gaya. What is no depreciation? Everything is done. Done and dusted. Are you getting my point? Now tell me one thing. Now before you go, you should understand the concepts. Tell me one thing. This asset, is it still there in your company? In your business? Is it still there in your business? Yes. Is it there in your books? No. Books it is fully depreciated. Now tell me one thing. If Manju's uncle had one Royal Enfield bike and uncle gave it to cousin and cousin gave it to Manju and this bike was purchased in 1980. Clear? 1980. No, those bikes are still sold for 2 lakhs, 3 lakhs. 1980. Now tell me one thing. This bike in the books, does it still have value? No. It would have been fully depreciated. Do you think somebody who purchased in 1980, they would have been like, oh, useful life 45 years till 2025. Do you think they would have done like that? No, they would have taken 5 years, 10 years, whatever, and useful life would have been, and then it would have been completely zero in the books. Is that clear? So now what you see over here is WDV. This is actually WDV, right? Cost minus depreciation till today. How much is the depreciation till today? 0. Now what you have to understand, moment you see this, if I sell it for 1 rupee, 1 rupee profit. Whatever value I sell it at, it is profit. Why? Because when we are calculating profit or loss on sale, we are comparing what? WDV on the date of sale and sale value. WDV on the date of sale and sale value. So now WDV on the date of sale is 0. Can we sell at negative? Can we sell at negative? At foundation level, no. Okay. But actually you can sell. Dinner time. At dinner time. Can we sell at negative? It's possible. You know what is selling at negative? Asset value is 0. To remove the asset and throw it from here, no. You have to spend 500 rupees. Are you getting my point? That is selling it at negative. That is possible, but they are not testing you at foundation level on all those things. So now, so here, whatever value you sell it, here it is either you sell it at 0 value or you sell it at positive value. Clear? Okay. Here also 2011 they have purchased one asset, 3 lakhs, and the depreciation till today is 3 lakhs. Can I tell that WDV is nil?
Yes.
Zil it seems. Okay, next 2012 asset value is how much? 10 lakhs. How much is depreciated till today? 9 lakh 50. Can I tell the WDV is 50,000? Next, 2013, 7 lakhs and 5 lakh 95,000. That means 1 lakh 5,000. Is that correct? Yes. 2020 and 21, ignore it. As we read further, you will know that they are not required only for our calculation. Okay, 2020 and 21, you know, you'll minus it if you want. Okay, you're feeling left out. 4 lakh 25,000 and 2 lakh 85,000. Is this clear? These are the WDVs, and WDV also will have a value. Now, depreciation is at the rate of 10% per annum on cost. What does it mean? Depreciation which method? Straight line method or WDV method? SLM, right? Now, yes, on cost means it is straight line method. But why I am trying to decode this sentence is for you to understand one thing. With this sentence, do you know what is a useful life? 10 years. This is very important. You know, the entire solution depends on, did you decode the useful life? 10%, right? 1 year you remove 10%. Another year 10%. 30, 40, 50. Like that it is 100% in 10 years. Okay, now you're like, sir, wait. Okay, now if I tell you 10% WDV, sir, is it useful life 10 years? No, because WDV will be what? On WDV. So it will always go reduce. After 10 years also some value will be there. But when you tell original cost is this much. Remove 10%. In how many years it's going to become 0? 10 years. Clear? Now you might feel, no, this question is so big, printed so much. You know what is the main bamboo here? This. That is the only thing. And understanding this sentence which has no financial figures but are relevant for our entire calculation. Always we tend to focus on what? Oh, this table. Okay, sir. This table has a lot of numbers. I have to focus here. And after that, this paragraph has a lot of numbers. I have to focus here. You know what is the game changer in this question? This paragraph, which has no numbers at all. Which has no numbers. That is the paragraph which is going to change the way you're going to think in the solution. Did you understand that useful life is 10 years? Did you understand how we got it? WDV, original cost method they are going to follow. That means straight line method they are going to follow. It is the company's policy to assume that all purchases and sales or disposal of plant occurred on 30th June in the relevant year for the purpose of calculating depreciation, irrespective of the precise date on which these events occurred. What bakwas accounting is this? You know what they are doing? They are like, you purchase the asset whenever you want. But in books, no. We will assume it as 30th June. That means you purchase the asset whenever you want. When in the year of purchase, you will get only half year depreciation. Correct? Then they said, you sell the asset whenever you want. In the year of sale, we will take 30th June. So it will be taken as half year depreciation. So whenever any asset is there, now here in this question, any asset, okay, imagine this is the useful life. Okay, useful life is how much? 10 years. Now, in the year of purchase, you will get only half year depreciation. And year of sale, you will get only half depreciation. In between, you are going to get 9 years depreciation. 9 years depreciation. That means basically the effective calculation time period is 11. First year half, then 9 accounting years, then last year. Are you getting this? So, did you get this by the way? No. That's what I told you. If you don't understand this sentence, right, there's no point of going into calculations at all. Forget about calculation. In fact, they made it even trickier. Calculation, they just give total in the material. They have not calculated individually. Now, again, I'm telling you, see, it is the company's policy. Are you asking me whether it's right or wrong? It's wrong. But it's company's policy. You're just going to do accounting. Just follow that company's policy. It is company's policy to assume that all purchases, sale or disposal of plant occurred on 30th June. Whether you purchase, sale or dispose, it's going to be on what? 30th June in the relevant year for the purpose of calculating depreciation. For depreciation calculation, it will always be taken as 30th June, irrespective of precise date. Let it be any date. Imagine I purchase the asset on the last day of the year. Actually, depreciation should be 0 there. Still, we'll take it as 30th June and give half year depreciation. I sell the asset on the first day of the year. That means no depreciation should be there. Because first day only I sold it. But still, I'll take it as 30th June. Is this clear, guys? Now, understand this. So, therefore, any asset has 10 years useful life. First year of its purchase, only half depreciation they'll get. Then 9 years full depreciation they'll get every year. Then last year, whenever they sell it, they'll get only half year depreciation. Is it clear? Whenever they sell or whenever they dispose. Clear? Now, let's understand. During 2022, the following transactions took place. During 2022, following transactions took place. Purchase of plant and machinery amounted to 15 lakhs. Sorted. Nothing is there. Out of 4 points, one is gone out of the books immediately. Now, listen. Shh. See over here. Forget this, okay? Forget this. Now, plant and machinery. At cost. Why they said plant and machinery at cost? Because they had provision for depreciation. Which method of computing depreciation they are following? Straight line method. Which method of computing depreciation? Straight line method. Which method of accounting they are following? Second method. Which method of accounting? Second method. So at cost, there is plant and machinery. And can you see depreciation provision account over here? Now, understand this. What is the total cost? 30 lakhs. So in the asset account, can you see 2 balance brought down? What is the total provision for depreciation? 21 lakh 35,000. Can you see over here buy balance brought down? Buy balance brought down. Now you go into the question. One thing has happened. Purchase of plant and machinery. 15 lakhs. Purchase of plant and machinery, how much? 15 lakhs. Tell me what is the entry. Tell me what is the entry. Machinery account debited to bank account. Yes. Let's make our food digest. Yes. Machinery account debited to bank account. Clear? Sorted clear? Now, in the entire question after this, there are 3 points. And the 4th point is always to calculate depreciation on the remaining assets. Are you getting my point? In the question, they will only tell you what assets are purchased and what assets are sold. But by default, after doing purchase and sale, you also have to calculate depreciation on the assets which are not sold. Are you getting this? Clear? Now, plant that had been bought in 2011 for 1,70,000 was scrapped. Plant that has been purchased in 2011. Look at 2011 asset. It is already at 0 value. It is already at 0 value. If it is scrapped, scrapped means what? Sold at 0 value. Scrap means you just took it and you just put it into the dustbin. That means it is sold at 0 value. That means there is no profit or loss. Second thing gone. Second thing gone. What happened? Raining, no problem. By the time we finish class, we'll stop. Okay? Don't worry about that. Rain will stop. By the time all clouds will go away. Rain, go away, come again some other day. Do you know that rhyme? Yes. Now, listen. Okay, listen to this. Disposal account. Disposal account. Shh. Under method 2, whenever asset is sold, what we do? First take the cost, put it to disposal account. Take the provision, put it to disposal account. Now, how much is disposed? 1,70,000. On this, cost is also 1,70,000. Do you agree provision for depreciation is also 1,70,000? Because it is fully depreciated. So now I should remove 1,70,000 and put it to disposal. I should remove provision for depreciation also and put it to disposal. Is that right? Now let's see what they have done. See over here, asset account. By disposal account. That means they have removed 1,70,000. And over here, to machinery account, 1,70,000. Is the cost transferred? Cost is transferred. Now, should you remove provision for depreciation also? Provision for depreciation is liability. When you remove it, what will happen? It will get debited. So, 1,70,000 removed and 1,70,000 is transferred to disposal account. In this 1,70,000 is there, okay? One place they put individual, another place clubbed. So, you don't know where the number went only. Okay, here it is 1,70,000. Is this clear? Are you following this? Any doubts with this till here? If you are thinking from where we are doing all this from here, see method 2. In method 2, whenever there is a disposal of asset, what do? Disposal account debited to asset account. Remove the cost, transfer to disposal account. Provision for depreciation debited to disposal account. Remove the provision, whatever is there, and transfer it to disposal. If you get money, put it into disposal. Then calculate profit or loss. Clear? Now, if I have to show you now. This is my disposal account. And here I'll write 2 plant and machinery, 1,70,000, and by provision for depreciation, 1,70,000. Is this clear? This thing is sorted. Should I write any bank entry here? No. Why? It is scrapped. Can you see the question here? It is scrapped. That means it is sold at zero value. Now, next. Only these two are going to play a crucial role. Without 4 points are there. That 2 got ruled out. We have 2 only. Plant that had been bought in 2012 for 90,000 was sold for 5,000. Plant that is bought in 2012. Understand this circus now. Okay. Plant that is bought in 2012. 2012, how much depreciation did you get? Half year or full year? Half year. Because whichever year you purchase, you will get half year. 2012 half. Clear? 2013 full. 14 full. 15 full. 16 full. 17 full. 18 full. 19 full. 20 full. 21 full. 22 we are here now. So 9.5 years depreciation is over. 9.5 years depreciation is over. Now what you are going to do? For half year you are going to calculate. Why half year you are going to calculate? Because it is sold in 2022 and whichever year you sell you should calculate half year depreciation. Can you see 9.5 years are over? You only have half year left. Now understand this. How much did they sell? 90,000. See over here now. Asset of 2012. 90,000 was the cost into 10% into 6 divided by 12. Is it 4,500? This is the depreciation for this year. Clear? Now, if you see no in the provision for depreciation account, full amount by P&L 263. That's why you are not able to get from where this 263 came itself. Now, can you see over here? Here also they have random written nil, half, full, half. We don't know what it is. Omelette, I think. Is it clear? Now, we'll do a calculation on our own. Okay. 4,500 is the depreciation till the date of sale. Okay. Because they are considering it as half year. Now, how much was the value? 90,000. What is the provision for depreciation on this? Provision for depreciation on this. 90,000 into 10% into 9.5 years. Because 9.5 years depreciation is over. So 90,000 into 10% into 9.5. Are you getting 85,500? This is the provision for depreciation. But did you just charge even that half year depreciation? Did you just charge half year depreciation also? Now your 10 years are completed. Therefore, can I tell total depreciation provision right now is 90,000. Total depreciation provision right now is 90,000. Now, if you look, you will find over here provision for depreciation 90,000. Okay, and here in this 90,000 is included. First asset ka 170, second asset ka 90,000. Is it clear? Now, can you see the cost also has to be removed? Where is the asset account? Plant and machinery. Sold. Sold, they are writing 330. How did it get 330? This one is 90. There is one more after this. That is 240. That is 240. Again, they have clubbed the numbers. That's why you are getting confused. Okay, this one is 90. There is one more which will be sold. That is 240. Clear? Now, tell me one thing. Is this asset fully depreciated? Is this asset fully depreciated? Yes. It was 9.5 years depreciated. This year we made it even for half year. Now it is fully depreciated. Now tell me, whatever we get when we sell, is it profit?
Yes.
How much did we get? We sold it for how much? 5,000. So now can I take it as sale value 5,000? Therefore, profit is 5,000. Profit is 5,000. If you're going to record in disposal account individually, no, they have recorded clubbed, right? Here you will write to plant and machinery 90,000. Cost is transferred. By provision for depreciation 90,000. The provision is transferred. You got money. So bank account debited to disposal. So you'll write by bank account 5,000. 90 0. So 5,000 if you get full profit. To P&L. The second sale transaction is done. Only one more sale transaction is there. Is it clear? Now, look at the question. Plant that had been bought in 2013 for 2,40,000 was sold for 15,000. Clear? When did they purchase? 2013. That means in 2013, how much depreciation they got? Half year. 2014, full. 15, full. 16, full. 17, full. 18, full. 19, full. 20, full. 21, full. 8 years done. And that half year. 8.5 years it is depreciated. Do you agree 8.5 years it is depreciated? Yes. Now, it has been bought for how much? 2,40,000. Asset of 2013. Okay, sale value is how much? They told that it is sold for 15,000. Sale value is 15,000. Clear? Now, what was the cost of that? 2,40,000. Okay, minus provision for depreciation. Provision for depreciation. Till now, how many years are over? 8.5 years. Correct? 8.5 years. So 2,40,000 into 10% into 8.5 years. 2,04,000. Is that clear? 2,04,000. But wait, WTV is not 36,000. 2,04,000. Now depreciation for 2022 half year. So 2,40,000 into 10% into 6 by 12. 12,000. That makes it how much now total provision? 2,16,000. So now how much do you have left? 24,000. This is WDV on date of sale. Now tell me one thing. How many years depreciation is over? 9. Correct? 8.5 was done. 0.5 we did. 9. That means 1 year depreciation should be remaining. Can you see 24,000 ka 1 year is 2,40,000. 1 year is 24,000 only. 1 year's depreciation. This is just your point of verification. Is this clear? Only if you do individual asset in this question, you will get the logic. Otherwise, if you see their total calculation, you will not get it. Clear? Now, 24,000. What is the sale value?
15,000.
Sale value is 15,000. That means you are selling it at a loss of 9,000. Now, first tell me what should we do? First, you should calculate depreciation till the date of sale. Okay, that we have to calculate. Now, that I am not in a position to show you anything because they have just put one total amount. Total amount. All the assets ka depreciation total amount. Later on, I'll show it to you. Okay, now, should I transfer the cost? How much was the cost? 2,40,000. Okay. Can you see over here? 2,40,000 is there in this. Previous asset ka 90 and this asset 2,40,000. That only became 3,30,000, no? Are you getting this? And how much is the provision for depreciation? How much is the provision for depreciation? 2,16,000. It was 2,04,000. We charged another 12,000 depreciation. So it became 2,16,000. Clear? Now if you notice over here, they have removed 2,16,000 from here. And they have transferred over here this 2,16,000. Can you see now their total? Does it make sense? First assets provision 1,70,000. Second assets provision 90,000. Third assets provision 2,16,000. That's how they got 4,76,000. Clear? First assets provision for depreciation 170, which we calculated. Second assets provision 90,000, which we calculated. Third assets provision is 2,16,000. Okay, when we are doing individual asset basis, so what will you do? To plant and machinery 2,40,000. 40,000. By provision for depreciation, 2,16,000. You got money. So by bank account, 15,000. Do we have loss? Yes. By P&L, 9,000. By P&L, 9,000. Clear? Now, one asset we made loss of 9,000. Another asset we made profit of 5,000. That means on the net basis, how much did we make? 4,000 loss. Correct? See the solution here. By loss on sale, 4,000. That also is net there. That also is on net basis. That's why you are not able to figure out from where the 4,000 came. Did you get it? Okay. Do individual asset basis. Now, by cash, you know how 20,000 they're getting? See over here. One asset sale, 5,000. Another asset sale, 15,000. That is how they are writing by cash also 20,000. Are you getting this? One asset sold for 5,000. Another asset sold for 15,000. Yeah, by bank you should have written. Okay, 20,000. Clear? And loss is how much? How? One asset there is a loss of 9,000. Another asset there is a profit of 5,000. That's how they are getting 4,000. Are you able to break down the numbers now? No. By P&L. You can directly write by P&L. No issues. Okay, now. I hope you got this 3,30,000. Asset from here it is coming. 240 plus 90,000. Now, everything that is given in the question is done, right? Everything. You know what is remaining? The remaining assets. You know what is remaining? The others. Others are going to play a very crucial role over here. Others. Now, tell me one thing. 2005 asset, do I need to bother? 2011 asset, do I need to bother? 2012 asset, do I need to bother? Yes. Yes. 2012 asset is sold, but not everything. 2012 asset is sold, but not everything. Only 90,000. So now 2012 asset, you see. 2012 asset. What was the cost of 2012 asset? 10 lakhs. Out of 10 lakhs, 90,000 gone. Into 10% into 6 by 12. Not full year. Sir, what bakwas, sir? What doka is this? If asset is not sold, you told full year. Only when asset is purchased and asset is sold. Those years, half year, you told. Correct? Now, 2012 asset. Are you telling me that 9,10,000 costing asset, was it used for full year? Was it used for full year? Are you getting from where we are getting these numbers? Cost of 2012 asset is 10 lakhs. Out of that, 90,000 was sold. That means 9,10,000 was used for the entire year. Now this 9,10,000, it is there for the entire year, right? When it's there for the entire year, you are thinking that we should calculate depreciation for the entire year. Is that right? But this asset was purchased in 2012. 2012 half year depreciation done. 13, 14, 15, 16, 17, 18, 19, 20, 21. 9 years done. 9.5 years depreciation done. So the value to be depreciated only is half year depreciation. When asset value is there, which is relevant to only half year depreciation, you cannot calculate depreciation for entire year, no? So, can you tell me what is the value now? Is it 45,500? 45,500. What was the WDV? We calculated WDV and kept over there 50,000. 45,500 depreciation we charged out of 50,000. Okay, 4,500 we charged that time when we calculated sale. See over here, 4,500. Tadang. Asset of 2012, 4,500, and here you are getting 45,500. That means total is 50,000. Now that asset is fully depreciated. Did you get it? Yes. Yes, difference is that. Now 2013 asset. 2013 asset, there is 7 lakhs, correct? Did you sell everything of 2013? No, you sold only 2,40,000. So now what is going to happen? 7 lakhs minus 2,40,000. Clear? Into 10%. Should I do 6 by 12? Should I do 6 by 12? No, for this full, because 2013 asset. 2013 half year. 14, 15, 16, 17, 18, 19, 20, 21. 8 years. 8.5 years are over. 1.5 year is remaining. So this year we will calculate full 1 year depreciation because it is used for entire year. Clear? This asset is also used for entire year, but we were not in a position to calculate depreciation for entire year because only half year's value was remaining. This asset is used for entire year. We are in a position to calculate depreciation for entire year because 1.5 years depreciation is remaining. Clear? Can you give me the value now? 46,000. Clear? Now 2013 done. 2020 and 21 I don't have to bother about anything. 2020 asset. Oh. 2020 asset. What is the value? 5 lakhs into 10%. Why am I calculating everything on cost only? Because it is SLM. Then 2021 asset. What is the value? 3 lakhs. On that, what will I do? 10% is equal to 30,000. Clear? These are all the old assets which are unsold. I have calculated depreciation. Now, what about the asset which is purchased in 2022? There is one asset which is purchased in 2022. How much is that? 15 lakhs, right? First line over here, 15 lakhs. So now, if you see 15 lakhs into 10%, should I just do 10%? No, 6 by 12 because asset purchased, half year depreciation. So 75,000. Clear? Do you agree? This is the depreciation on asset unsold. Unsold, 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 new purchase. Wait a second. Depreciation on asset sold. There were two assets which are sold. Correct? One asset is over here. 2012 wala asset when we sold, we got 4,500 depreciation. 4,500 depreciation. There was 2013 asset when it was sold. How much depreciation was there in that year? 12,000. 4,500 plus 12,000. Does it make it 16,500? Now use the calculator. How much are you getting? 2 lakh? No, 63,000. 2 lakh 63,000. Do you agree this is the total depreciation for the year? 2 lakh 63,000 is the total depreciation for the year. Asset sold, asset unsold, asset purchased, everything together. Magic number 2 lakh 63. By P&L account. It's actually supposed to be by depreciation account. By depreciation account 2 lakh 63. They have given the breakdown of it. Okay. Don't think that IC has not done, but they have done like this. They have done like this. Okay. If you are able to understand, you are able to understand, but otherwise you are not able to understand. That's it. Is it clear? Did you understand how? Now see, what numbers we have not discussed. Opening balance already from the question. Okay. This is new purchase from the question. This scrapped we have already seen. Transfer to disposal account. Sold we have seen two items are there. This and this. That made it 3 lakh 30. Okay. Then only balance carried on in asset account. Provision for depreciation account. Opening balance we know. Total depreciation we just calculated 2 lakh 63. Then this is the depreciation on asset scrap. This is the depreciation on asset sold. This is the depreciation on asset sold. We removed that and we transferred it to disposal account. Disposal account, I am not showing this. I mean, I am showing this, but we have discussed it in detail. Okay, you can see the disposal account where we have done item by item. First scrapping, second sale, and third sale. But even the disposal account also, I showed you how this 20 came, how this 4 came, and how this 170 and 130, 330 came. Are you getting this? Actually, it's not a difficult question. They have not presented the answer properly. It is not a difficult question. The presentation of the answer made it a mess. And 4 times they have published new editions, but they kept it like that only. They are like, you feel tough. I feel nice. That is their logic. You feel tough, I feel nice. Then when you feel tough and I feel nice, I will pick that only and give in the exam. Are you getting my point? Yes, I would suggest that you can maybe just quickly have a click a picture or write this or click a picture of disposal account. Just click a picture of disposal account. Whenever you want the breakdown of it, right? This is the one. Done. There's another half. I'm seeing if it's working. The gestures are not working. What is this? Done, no? Okay, guys, that's it with that particular question. Simple and small question. Next, I want you to go to the next question. That is question number 7. What did I tell you? This is from June 2022. Okay, we'll have a look at this question from June 2022. Depreciation SM is done. Done now? All good, ready? Yes? You are required to prepare the following ledgers. Sale or disposal of plant and machinery. Then you would have routed it between this only. But if you prepare disposal account, it's easier for you. They will give marks. You can do it within that also, or you can create it also. If you create it, it's simple, right? Take the cost from there, put it here. Take the provision from there, put it here. Then you just put the amount there and calculate profit or loss. Okay, guys, let's go further. Depreciation. How is the depreciation, Bambu? Actually, it is not tough. Only that question is like that. It's not tough. Only that question is like that. Okay, and I'm telling you, everywhere depreciation, the trouble or mistake that students are making is not in purchase, not in sale. After everything, calculating depreciation on remaining things. That is where you are messing it up. Purchase, you know, from that day you will calculate. Sale, you know, till that day you will calculate. Now, let's go to the end of this question, guys. Without provision for depreciation, prepare machinery account for the year ended 31st March 2021. Allow the same rate of depreciation as in the past and calculate depreciation to the nearest multiple of rupee. What does it mean? What does it mean? That means if you are fighting, fight over rupees, but don't fight over paise. If there is decimal, please round it off. That is what they are trying to tell. Also show all necessary working notes. Oh, imagine they didn't give this. Can we do all calculator working notes and answer? Why not? Here they told no, show all necessary working notes. If they did not print this sentence, can I directly prepare only machinery account and all calculations from my mind or from the calculator? Can I do that? No, why? Yeah, but they didn't type in the sentence. Depends on the marks. 10 marks. 5 marks. Just like narration, huh? Narration is untold, okay? That is supposed to do. But working notes is told. You know where? In the first page. In the first page where they have written no instructions, they have told all working should form part of your answer. Are you getting my point? So, we are not looking into the side person's paper and writing, no. We are only solving, right? So, let's show the working notes. Okay, guys, it's there over here. Let's start. Shh, guys. For which year they asked? 31st March 2021. So, do you agree? I only have to prepare for 2020-2021. I don't have to prepare from beginning of time. Only from 2020-2021. Yes. Now, machinery account of a factory showed a balance of 95 lakhs on 1st April 2020. Straight away into your pocket. They have given the balance. What is the balance on 1st April 2020? 95 lakhs. So straight away you will go into the ledger. 1 second. Straight away you will go into the ledger and you will write 2 balance brought down 95 lakhs. Finished. Correct? I mean finished now. Started. Now. Books of accounts of the factory are closed on 31st March every year. Thank you for telling that we are following financial year. Okay. Depreciation is written off at 10% per annum under diminishing balance method. That means which method? WDV method. On 1st September 2020, a new machine was acquired at a cost of 14 lakhs. Not that much. And 44,600 was incurred on the same day for installation charges of erecting the machine. Half the question got over. Yes. Correct. So now, to bank, total cost plus whatever related expenses are there, everything is capitalized. Remember capital and revenue expenditure. When capital expenditure is there, along with that all chain reaction which comes, everything will be capitalized. Okay, done, finished. What is it there? What is there in this then? Two sales. On 1st September 2020, machine which had cost 21,87,000 on 1st April 2018 was sold for 3,75,000. At least better. See the next one. Another machine which had cost 21,85,000 on 1st April 2019 was scrapped, realizing nothing. But my point is, when did they scrap or when did they sell? They sold this on what day? See over here. On 1st September 2020 they sold, and here also 1st September 2020 they sold. Is that right? Correct. So now that means we have to calculate depreciation for 5 months. 5 months, 1st September, 5 months. This is the regular mistakes of exam. When we see September, that means 6 months. But it is 1st September. Are you getting my point? So now understand this. First we have to calculate, whenever there is a sale, we have to calculate WDV till the date of sale. WDV till the date of sale. So now when we have to calculate WDV till the date of sale, okay, we need working notes. See the first one. Calculation of loss on sale of machine on 1/9/2020. When did they sell it? 1/9/2020. When did they purchase it? See over here. When did they purchase it? 1st April 2018. That means I have to remove the depreciation of 18/19. I have to remove the depreciation of 19/20. And then I have to remove the depreciation for 5 months. Clear? Now see this. Depreciation 10%. Okay. 1 full year. This is for 18/19. Then you get depreciation 10%, 1 full year. This is for 19/20. Then on whatever WDV is there, you are calculating depreciation for 5 months. That is 73,811. Are you getting this? For 5 months. Now when you remove that, you will get the value. This is called as WDV on date of sale. Is this the WDV on the date of sale? Yes. From that, if you remove 3,75,000, what is 3,75,000? It is sold for 3,75,000. Sold for 3,75,000. That means remaining everything is what? Profit or loss? Loss, oh loss. 16 lakh asset, not even 16, 17 lakh, because 97,000 it is. 17 lakhs asset, you're selling it for 3,75,000. Don't worry, next one they're selling for 0. Okay, this at least for something chiller you got. There you're getting nothing. Okay, now listen. First, what should we enter whenever asset sale happens? Method 1 of accounting. First, you should enter depreciation till the date of sale. What is the entry? Depreciation till the date of sale. What is the entry? Depreciation account debited to asset account. Okay, machinery. Is it 73,811? 5 months depreciation. Is it 73,811? Yes. Can you see over here? By depreciation 73,811. Then you should record what? Not loss. First money should come. Sale. That is by bank. 3,75,000. Yes. After that, whatever is there is loss. By loss on sale can be written as by P&L 1322,659. Done. This is the first sale. Gone. First sale is gone. What is the second sale now? Second sale is sold for nothing. But when was that asset purchased? It was purchased on 1st April 2019. That means I have to remove the depreciation for 1920 and then 5 months in 2021. 1920 and 5 months in 2021. So when you are doing that, understand this. Cost is given over here 21,85,000. This is the depreciation for 1920 and this is the depreciation for 5 months. This is the depreciation for 5 months. When you remove this, you will get, they are directly rating loss because it is sold for 0. Don't you think it is WDV actually? WDV on the date of scrapping. WDV on the date of scrapping and it is sold for 0. That means 100% loss only. What should be the first thing? Recording the depreciation for 5 months. Go and check. Can you see by depreciation 81,938? Then next thing should be actually receiving amount. We are receiving nothing. Are we receiving anything? Nothing. That means full amount is loss. Full amount is loss. Is it clear? 2 things done. Now only thing remaining is to calculate depreciation on the remaining asset. Remaining asset. Now tell me one thing. I gave you one formula that time to calculate depreciation on remaining assets. Where is it? Here. Total WDV at the beginning of the year. minus WDV of the assets sold at the beginning of the year. Clear? Tell me in this question, what is the total WDV at the beginning of the year? Is it 95 lakhs? Total WDV at the beginning of the year, is it 95 lakhs? Yes or no? Yes. Out of the two assets we sold, this asset, what was the WDV at the beginning? 17 lakh 71,470. Now you are like, sir, don't we have to see this WDV? No, that is the WDV on the date of sale. We want to know what was it at the starting of the year. Okay, 1771,470. One more asset is scrapped. What is the WDV at the starting of the year? 1966,500. So you'll write over here 19,66,500. Why aren't we writing this one? Because that is on the date of sale. That is only to calculate profit or loss. At the starting of the year, it was this one. Okay, so that means, do you agree whatever is there is for the remaining assets? So 95 lakhs minus 1771,470 minus 1966,500. Are you getting 57 lakh 62,030? 57 lakh 62,030 into how much is the depreciation rate? 10%. Can I take it as 5 lakh 76,203? 5 lakh 76,203. That is the depreciation on the remaining assets. But that is not the value that you will find over here. That is not the value you will find over here because you have not taken the depreciation on the new asset. New asset is 1444,600. So 1444,600 into 10% into 7 by 12, not 6. 7 by 12 because it is purchased on 1st September. 1444,600. 84,268. Put that over here. What is the total you are getting? 576,203 plus 84,268. Are you getting 660,471? Is that the depreciation sitting over here? Yes. Are you getting this? It's very, very critical to calculate this. Now understand this. 19 will make you make a lot of mistakes. 19 purchased on 19. That means you have to calculate 7 months depreciation. Sold on 19. That means you have to calculate 5 months depreciation. Is it clear? Any doubts with this one? Did you understand? 2 times we have sold. Once we have sold for 0 value. That's why it's called as scrapped. The other time we have sold, but it is sold for some value. So it is called as sale. So both the times you have to calculate depreciation till the date of sale to find out the profit or loss. But when we are trying to find the depreciation on the remaining assets, that time what we will do, we will remove the WDV that was there at the beginning of the year. Because as I told you earlier, what is there at the beginning of the year, only 2 things can happen with it. Either it stays till the end of the year or it is sold during the year. What is sold, if you remove, everything else has stayed during the year. Clear? That was the June 2022 question. The other question that we have to address is June 2023, 10 marks. June 2023, 10 marks. This is with the provision for depreciation. Clear? Let's get ready. Okay guys, let's go further. Okay. Now, have a look at this question for 10 marks. Following balances appear in the books of Dheeraj Enterprises. Following balances appear in the books of Dheeraj Enterprises. Look at the end of the question. Prepare machinery account, provision for depreciation account, and machinery disposal account for the year ended 31st March 2022. That means for which year they are asking? 21-22. They are asking for 21-22. Is it clear? Now, machinery account on 1/4/2021. 12 lakh. So directly I know the opening balance. Go to machinery account and write to balance brought down. Clear? And there only I know provision for depreciation on that day. 4,65,000. Go to the provision account and write by balance brought down 4,65,000. Is it clear? Now, on 1st October 2021, machinery which was purchased on 1st April 2018 for 2 lakhs. Okay, was sold for 1,10,000. Depreciation rate you see 10% WDV. Okay, now when was it purchased? 2018. So now can I directly tell 2 lakh minus 10%? This is for what? 18-19 minus 10%. This is for what? 19-20. And minus 10%. This is for what? 20-21. What is the WDV you're getting? 2 lakh minus 10%, minus 10%, minus 10%. 1,45,800. Is it 1,45,800? Now, on this, should we calculate depreciation for 6 months? Because it is sold on what date? 1st October 2021. So now what will you do? You'll do nothing. Eat first or do nothing. Huh? Clear? Now what will you do? Remove depreciation. Depreciation on 1,45,800 into 10% into 6 divided by 12. Why 6 divided by 12? 6 months. 7,290. Now what is the WDV on sale date? WDV on sale date 1,38,510. Okay, and this asset is actually sold for what value? 1,10,000. So sale value is 1,10,000. 28,510 is the loss. Did you understand the calculation behind this? Now tell me one thing. First I should calculate depreciation till the date of sale. That entry is not passed. So this 7290 has to be passed. What is the entry? Depreciation account debited to provision for depreciation. Provision for depreciation. Can you see 7290 here? By depreciation. Next what I should do? Remove the cost, put it to disposal account. Remove the cost and put it to disposal account. What is the cost? 2 lakhs. So here can you see by disposal 2 lakhs removed and go and put it to disposal account. Can you see 2 lakhs here? Now then what we should do? All the depreciation till today you should remove it and put it to disposal account. How much is the depreciation? All these years 1, 2, 3 years it is 2 lakhs minus 145,800. Is it 54,200 depreciation for 3 years? And this 7290. And this 7290. So 54,800 plus 7290. Are you having total depreciation of 62,090? Oh, sorry. My bad. 61,490. Is it 61,490? Total depreciation for all these years. This I should remove from provision and put it to disposal. Provision account debited, disposal account credited. Clear? When you sold, you got money. Bank account debited, disposal account credited. You got loss. P&L account debited, disposal account credited. Clear? This is the entire thing about sale. When there is provision, what you should do? First, you should calculate depreciation till the date of sale. Then you should remove the total cost and put it to disposal account. Then you should remove the total depreciation and put it to disposal account. But when you remove the total depreciation, remember one thing. Even this year's that little depreciation also will go to disposal account. Clear? So when you calculated this, no, all these 3 years depreciation plus this 7290 will also go to disposal account. Are you following this? Next. Done. Okay. Then whatever money you get, put it to disposal account, profit loss, from there only you can transfer. Now after that, they said on the same day, another machinery was purchased for 4,80,000. What should be the entry for this? Machinery account debited to bank. Finished. Machinery account debited to bank. Now machinery account is at cost. So this is the balance carried down. This is the balance carried down. Finished. Now only thing that is remaining is you calculating this one. Depreciation. You calculating depreciation. Now listen. What was the opening WDV? What is the opening WDV? Can you see 12 lakhs? 12 lakhs is not the opening W. 12 lakhs is the cost. 12 lakhs minus 4 lakh 65,000. That is 7,35,000. That is the opening WDV, no? WDV means what? Cost minus depreciation, not only cost. Okay, 7,35,000. From this, do you agree? I have to remove the WDV of assets sold. But WDV of assets sold on the date of sale or at the starting of the year? Starting of the year. What was it at the starting of the year? 145,800 minus 145,800. 7,35,000 minus 145,800. 5,89,200. Is this asset used full year? Into 10%.
58,920.
That is the depreciation for the year. But during the year, we purchased one asset also. That asset was purchased for how much? 4,80,000. So 4,80,000 into 10% into 6 by 12. 24,000. These two together, 82,920 is the depreciation on the remaining assets. 82,920. Is it clear? After that, nothing. Balance carried on. That's all. After that, it's just balance carried on. So, what I feel where you can go wrong is one, missing that you have to calculate depreciation till the date of sale. Second, you will remove the cost and put it to disposal account. That is fine. You will remove the provision for depreciation and put it to disposal account. That time you could have made a mistake of removing only 54,200, but you have to remove 54,200 and 7290. That means whatever is calculated even during the year, you have to remove from provision and put it to disposal account. Clear? Then finally, when you are calculating depreciation on remaining assets, remember, you have a formula set in place. Opening WDV minus WDV of assets sold. But minus WDV of assets sold. WDV of assets sold is not on date of sale. It is not on date of sale. It is at the beginning of the year. Is this clear? See. We have it over here. Total WDV at the beginning of the year minus WDV of assets sold at the beginning of the year. That will give you the WDV of asset unsold. But only that if you calculate depreciation, again you are wrong because there is also a new purchase. On that also you have to calculate depreciation. Is it clear? Yes, that's it guys with that particular question. Okay, what do we have left? 4 years depreciation questions you have to see. New scheme. Starts with June. Continues with September. Goes to January. Then goes to May. Then we have to go to next chapter. Clear? We'll see in June. We'll see in June. Okay. Do we have any depreciation question? 8 marks, huh? Tadang, it's here, sitting over here. Okay. How much was it asked for? 8 marks. Show machinery account and ascertain the amount chargeable to P&L as depreciation in the year 2022-23. They told show machinery account. That means which method of accounting are they following? What? Which method of accounting are they following? Method 1 or method 2? Just by seeing machinery account, I cannot tell it straight line. No. It can be WDV, machine earth, anything. Okay, they said machinery account. That's why you are following method 1 of accounting. Not computing. Computing, how to compute, they will tell. Is it clear? Next. On 1st April 2022, LMP company which depreciates its machinery at 10% per annum on diminishing balance. Oh. Not straight line. Diminishing balance method had 9,72,000 to the debit of machinery account. What is this? What is 9,72,000? Balance brought down. Go to the solution, have a look and have fun. Alternative 1 and all they have given. Oh, that means they are also not sure what they want to do. 9,72,000. Is it clear till here? Now, next. On 1st October 2022, part of the machinery purchased on 1st April 2020 for 80,000 was sold for 45,000. For 80,000 was sold for 45,000. When did they purchase this? 1st April 2020. That means they have to remove the depreciation of 2021, 21-22 and again 6 months. Are you getting this? Let's see the calculations. Directly, I'm sure they would have done it. See, 80,000 minus depreciation for first year 2021, and then depreciation again for second year 21-22. This is the WDV at the starting of the year, but it is sold on what day? 1/10/2022. So again you have to calculate depreciation for 6 months. 3240. Now that time you will get the WDV on the date of sale. WDV on the date of sale. Now sale value. How much is the sale value? 45,000. Just close that door. Guys, when you come in, no, you should close. When you go out, you open, right? Same way. Like for example, where did you go now? I'm just asking, where did you go now? Some crazy thought came to my mind, okay? Where did you go now? Washroom, right? Whatever you wanted to do. There was opening. Then you closing. Did you get my point? Same way when you went, opening the door and came back closing the door. Yes. If you know, you know, guys. Okay, sale value. Hello, madam. I just explained. Why should only boys be targeted? She'll watch it on YouTube. All good? Yes, let's continue. 45,000 is the sale value. So 16,560 is the loss on sale. From where am I getting these numbers? From the question itself. Can you see over here? Okay, can you see over here? The asset was actually sold for 45,000 and it was sold on 1st October 2022. That means 6 months depreciation has to be computed, and that 6 months depreciation has to be even debited to machinery account. Can you see here? Machinery 3240. By bank 45,000 because we got 45,000, and the loss will be debited to P&L. After that, what is remaining in this question? Only the depreciation, remaining depreciation. Only remaining depreciation. Now see over here. After that, if you read the question, also new machinery was purchased for 150. Very good. On 1st October. That means half depreciation even for that. And installed on the same day installation charges for 8,000. Don't forget that. So, can you tell me that 1,58,000 is the machinery value? Into 10% into 6 by 12. So, 15,800 divided by 2 is how much? 7,900. Is that the depreciation on the new asset? On the new asset. What was the opening WDV? 9,72,000. Out of this, what should I remove? WDV of the asset sold. WDV of the asset sold. Okay, WDV of the asset sold is how much? 64,800. Sir, don't we have to take 61,560? No, 61,560 is on the date of sale. You have to take at the starting of the year 64,800. So if you take 64,800, so 972,000 minus 64,800, you have 9,07,200. Is this asset there for the entire year? Yes, 90,720. This and this, 90,720 plus 7,900. Are you getting total depreciation of 98,620? This is the total depreciation which you should find. Oh, we are not finding it. What is this? What did we miss? Question only. Oh, because we didn't continue reading. Machine company changed the method of depreciation from diminishing balance method to straight line method with effect from 1st April 2020. Oh. After reading entire question, now they are telling they changed on 1st April 2020 and adjusted the difference on 31st March 2023. Okay, the rate of depreciation remains the same. What? What is ICA trying to tell? They are telling that they changed the method on 31st of March, 1st April 2020, and they're giving difference on 31st March 2023, and rate of depreciation remains same. That means 10% only it will be, but this time we'll calculate 10% on straight line method. Is it clear? If that is the case, then we didn't compute it, we just discussed it, right? This depreciation which is there for 6 months, okay, is it 64,800 3240. This they have calculated under which method? WDV. But they told what? Straight line method. Are you getting this?
Yes.
They told what? Straight line method. Now, understand this. Computation of written down value they are telling. You know how they got the written down value? 9,72,000 is there. Go back. Then come front. Okay, 9,72,000 is on what day? 1/4/2020. Okay, actually it's not on 1/4/2020. In the question, I think it is 2022. Now using this 2022 value, I have to go to 1/4/2020. Why should I go backwards? Because I have to change the method of depreciation. 972 is after using which method of depreciation? WDV. So when you go back, 972 is 90%. How much is 100%? You'll go 1 year back. So when you do 972,000 divided by this, will you get 10,80,000? Now again you will do 10,80,000 is 90%. How much is 100%? I think you'll get 12 lakhs. That is how they got the cost of the machine as 12 lakhs. Cost of the machine as 12 lakhs. Now what they are telling, remove that machinery which is sold. Machinery which is sold was sold for how much? How much ever, doesn't matter. Cost was 80,000. Cost was 80,000. So now you have 11,20,000. Now 11,20,000 is there. Now take 10%. Still diminishing balance. Still diminishing balance. Take 10%. Then again take 10%. Still diminishing balance. Did you get some value on 31st of March 2022? Then 9,07,200. Total depreciation as per diminishing balance method 1,08,000 and 1,12,000. That is 2,12,800. Then they are telling calculate depreciation as per straight line method. Excess depreciation to be charged to P&L. What bakwas is this? When they have clearly told that you cannot follow retrospective effect. Aren't they actually doing retrospective effect over here? That is why they give alternative 2. They are like, if you feel not right with this, if you feel not right, if you feel that you are harmed, let's solve under alternative 2. Alternative 2, see what they have done. This and all same, okay. It cannot change. Now see, in alternative 2 what they did. Everywhere SLM. Everywhere SLM. Which is correct? Alternative 1 or alternative 2? Alternative 2 is correct because they are supposed to change the method over there only, not today. From that day only, straight line method. So everywhere SLM. Clear? Now computation of written down value, you see. Everywhere they are calculating under SLM only. Oh no, again they are following diminishing balance. Oh. Now you know what is the issue over here? ICA copy pasted old question. Simple. What happened is ICA copy pasted old question. Now after they copy pasted old question, they can't defend their mistake, right? They can't defend they have to defend their mistake, right? So to defend their mistake in suggested answer, full whatever they wanted, they printed. Okay. Now actually, if you have to solve this correctly, you know how you are going to solve this correctly? June 2024. See this question. Listen. Company changed method of depreciation, okay, from straight line to diminishing on 1st April 2020. That means everything from 1st April 2020 has to change. Everything from 1st April 2020 will be SLM. When you're calculating depreciation on the assets sold, also SLM. When you're calculating depreciation on remaining assets, also SLM. Entire question has to be done under SLM. Is it clear? Are you getting this? Did you understand the mistake which ICA made? Obviously, they're not going to repeat it again. Cost value will be 12 lakh. And on 12 lakh, 1,20,000 will be the depreciation if you're calculating total. Is it clear, guys? Did you try this question before and get totally messed up? No. ICA only is messed up. Because alternative 1, alternative 2, both don't have sense. In alternative 1, they are reversing. After that, again, they are using diminishing balance. What is the point of reversing? Alternative 2, assets sold, they are using the straight line method, but asset unsold, WDV method. If you are using straight line for asset sold, asset unsold also use straight line only, no. Are you getting this? See, what happened is, these questions made sense 3 years back or 4 years back. because that time you had to calculate depreciation from starting and adjust. Now what ICA being lazy, just like you guys, okay, they would have copy pasted some old question from some old RTP without thinking that, oh, now it has changed, but then they have to defend themselves. So in suggested answer, they gave random things, okay, and I know grace marks, they'll give grace marks, okay, but grace marks, how they'll give, they'll give +4 for everyone, not for people who attempted, not attempted. They'll give +4 for everyone because overall paper was difficult. So they'll give +4 or +5 for everyone. So it doesn't actually boost your marks just because you attempted this. Okay, so you just have to hope that ChatGPT doesn't make mistakes. Not ICA. ICA will not make any mistakes. ChatGPT should not make mistake. Now because nowadays ICA is putting question into ChatGPT and telling, give me similar question. Then ChatGPT is giving random question where authorized capital is more, issued capital is less. Then we don't know what to do. We'll see in company cons, we'll see. Okay. Did you get this, guys? Now some of you, please don't ask me, sir, can't we go and fight with ICA by going to court and all? Somebody already tried it. Suggested answers. They just told suggested answers, like the name suggested, it is just suggested. I never told you it is final. I told suggested. That's it. So I always tell this. You can't fight with the guy who is not fighting back. You go and tell the guy, you are mad. He's like, yes, I'm mad. Now what will you tell? Correct? Fight ends over there only, no? Imagine you're taking stone and going to throw at one guy. That fellow picked the stone and threw at his leg only. Now you're like, what just happened in this fight? Okay. The only thing we can hope for is ICA doesn't make mistakes, okay? In next exam, did they ask anything from depreciation? No break, no break. No. We'll finish depreciation and then think about it. Bye. Do we have a depreciation question in the next exam? Is it towards the end? Yes. They asked depreciation question for 5 marks. September. Yes. PQR Associates bought a computer set on 1/4/2020 for 2 lakhs and charged depreciation at 20% per annum on diminishing balance method. They made further additions as follows: 1/4/2021, 1/4/2023. Do you feel deja vu? Do you feel deja vu? The question which we just did, changing the method of depreciation, 22 or 23. On 1/4/2023, it was decided to change the method of straight line basis and charge depreciation assuming expected life of all computers to be 8 years before 1/4/2023. Prepare computer. Huh? Yeah, this is September. But what I'm trying to tell you is, let it be September or July, whatever. I'm telling you, same question is there here. Where you know? What you're telling here. SM10. It is exactly SM10. Are you getting this? Okay. What is? Now from which method to which method we are changing? WDV to SLM. WDV to SLM. Clear? If you notice, for 5 marks it is too much, okay? See, same working is there in the study material also. First one from 2020 onwards you calculate depreciation. Second one 2021 onwards you calculate depreciation. Then you get WDV over here. For this WDV you are going to use SLM. And SLM here, what did they tell? 8 years. Just verify this. 128 divided by 8 years, no? How many? Not 8 years, huh? Five years, huh? I think it's 5 years, not 8 years. Where is it? See, here you see, assuming that expected life of all the computers to be 8 years from 1/4/2023. All computers, it is how much? 8 years. Now, when did we purchase this one? 1/4/2021. Sorry, when did we purchase this one? 1/4/2020. 2021, 21, 22, 22, 23. 3 years are over. That means how many years are remaining for that one? 5 years. When did we purchase this one? 1/4/2021, 21, 22, 22, 23. 2 years are over. How many years should be remaining? 6 years. So now if you see the calculation over here, this is divided by 8 and this is divided by 6. 120 divided by 6. For both they have done 5 years only. What bakwas. See, 1/4/2020, 1/4/2020. Huh? See the question, guys. When did they purchase this? 1/4/2020. Okay, charge depreciation at 20% per annum on diminishing balance method. Till when they have to charge under diminishing balance method? Until 1/4/2023. After that only they are going to change. I think it is 1/4/2023 only. No, here it is 1/4/2020. Sorry, not 8 years and 5 years over here. From here it becomes 8 years. What they have done is one more year's depreciation should be there over here, which they haven't computed. Now what will you do? 1,02,496,000. Can you calculate 1,02,400 plus 96,000? Okay, divided by 8. Is it 24? 24,800. Yes, that is the depreciation. What is this 15,000? New asset. New asset is purchased over here. New asset is purchased over here, 1 lakh. For that, what will be the depreciation rate? No rate, just 8 years. 1 lakh divided by 8, that also you will get 12,500. Clear? SM10. SM10. SM10, what they had done? 6 years and 10 years. Now what they have done? Directly they have taken 8 years. Directly they have taken 8 years. Clear? For old assets, new assets, everything they have given 8 years. Are you getting this question? Yes. Let's go further. What about Jan? Do we have anything in Jan? Oh, only 10 marks. Question number 2 in Jan. Shh, guys. Now go to the end of the question and see what they asked. You are required to prepare machinery account. You are required to prepare what? Machinery account. Because you are required to prepare machinery account, you know that they are following method 1 or method 2? Method 1. That means everything is going to happen inside the machinery account itself. Now let's read the question. Firm purchased a second-hand machinery on 1st April 2021 for 15 lakhs. Subsequent to which 2 lakhs were spent on its repairs and installation. That means total cost is how much? 17 lakhs. On October 1st, 2021, another machine was purchased for 9 lakhs. Is it the same year? Starting of the year, they purchased one asset, and during the year, they purchased one more asset for 9 lakh, and cost of installing the machine in a new plant is 20,000. That means this becomes 9 lakh 20,000. Clear? Then, firm also shifted the machinery purchased on 1st April 2021 to the new plant and incurred freight of 10,000. Let them incur whatever they want. That is gone. If you are shifting the machine from one place to another, that is not going to be considered as capital expenditure. That is revenue expenditure. That is not going to bother us. They adopted a policy of charging depreciation at 12% per annum on diminishing balance. WDV. Clear? Next. On 1st April 2023. 1st April 2023. Where are we? 1st April 2021. When they started the story, we are in 1st April 2021. And you have to understand here, you are required to prepare machinery account for only 23, 24. 23, 24. On 1st April 2023, it was decided to change the method and rate of depreciation to straight line basis. Oh. What are they doing? Starting of the year, they changed everything to SLM. On this date, the remaining useful life was assessed at 5 years for both the machines purchased with no scrap value. Then during the year, they purchased one more machine. First machine became outdated and sold for 2,50,000. On the same date, another machine was purchased for 8,50,000. Estimated useful life of the machine is 10 years and residual value is 30,000. What are we supposed to do? Wait. What are we supposed to do? Our year starts with SLM only. Our year doesn't start with WDV. Our year in the question starts with SLM only. Now, this one is purchased for 17 lakhs, right? 17 lakhs. Okay, minus. When did they purchase it? 1/4/2021. 21, 22, 22, 23, 2 years went already. And what rate of depreciation they used there? 12%. So you'll write minus 12%, minus 12%. 13,16,480. Clear? One more asset was purchased. No, for how much? 9,60,000. 9,20,000. And it was purchased on what? 1st October 2021. So 9,20,000 minus 6% minus 12%. Why minus 6%? First year only half and second year full. So 9,20,000 minus 6% minus 12%. 7 lakh? Clear? Two assets. Do we have any more assets? No. So 13, 16, 480 plus 761, 024. Do you agree? 20, 77, 504. This is the WDV on 1/4/2022. For this anymore, you will calculate under which method? SLM. What? Sorry. No, 2022 only, no? 2023. Not 2022, 2023. If you go into the question 2077,504. This was the value we are looking for. 2077,504. Machine 1, machine 2. Both we have calculated separately. 13, 16, 480 and 761, 024. This is your starting point. Now, from here, whatever you see, it is straight line method only. No WDV. From here, whatever you see, it is straight line method itself. Clear? Now, what happened during the year? We sold one machine, right? Where did it go? Yeah, we sold one machine on 1st October 2023. First machine became outdated. First machine ka value, what is it? This one. It became outdated. And it is outdated and sold for how much? 2,50,000. All these old machines, what was their useful life? 5 years. All these old machines, what was their useful life? 5 years. So 13, 16, 480 divided by 5 years into 6/12, because I sold it exactly at the middle of the year. 13, 16, 480 divided by 5. 1,31,648. Is this the depreciation till date of sale? Till date of sale. So what is the WDV now on date of sale? How much? 11,84,832. And I saw WDV minus depreciation. 11,84,832. What is it sold for? Sale value. It is sold for 2,50,000. Peanuts. So you have 9,34,832. 9,34,832. I hope it's clear, guys. This calculation. Can we take it there? We'll keep it here. Okay. Now look at the solution. Can you see the depreciation till the date of sale? 131,648. 131,648. Can you see the amount received? 2,50,000. Can you see the loss on sale? 934,832. Is it clear? After that, you have only one thing. What is that one thing? Calculating depreciation for the remaining thing. But did we purchase one more machinery? That is for 8,50,000, but it is purchased on 1st October. How will we calculate for this 1st October thing? See what is the rate of depreciation, what is the useful life they have given in the question. Where is it? Yeah. How much is the useful life? 10 years. That old machines which got converted from WDV to SLM, for that the useful life is 5 years. This new machine, okay, for that the useful life is 10 years. So now if you see 8,50,000 divided by 10 years, but into 6/12, 41,000. 42,500, right? Is it not 8,50,000 then? Did we take some wrong number? Another machine was purchased. Oh, residual value is there, 30,000. What is this? Okay, 8,50,000 minus 30,000. So it becomes 8 lakh 20. Then 41,000 is correct. 8 lakh 50,000 minus 30,000 divided by 10 years into 6 by 12. That makes it 41,000. Is it clear?
Yes, sir.
So this is the depreciation on the new machine. What about old machine? We already know machine 1 got outdated. What is remaining now? Only machine 2. And for that machine 2, 7,61,024 divided by 5 years, not 10 years. So 761,024 divided by
1,52,205.
1,52,205. Do you see what's happening? Question started 2 years ago and it continued on WDV. But our solution started this year. And from this year starting, everything was SLM itself. Everything was SLM itself. Now, what is the most crucial thing here, Computing this. Computing this. After that, it's straight line method. Then you can only make mistake of taking 5 years here by mistake and forgetting that this is 5 years. And for this year, it is 10 years. Clear, guys? They've shown the calculation also. You can see it. No issues. Now, what else? We have one more. May 2025. Did they ask in May 2025 also? Yes. Where did they ask it? They didn't ask in May? 5 marks at the end, no? Okay, Chillu question. 5 marks. What? 5 marks question. On 1st July 2022, Maritime Limited purchased a second-hand machine for 1,20,000 and reconditioned the same by spending 18,000. That means total is 1,38,000. On 1st January 2023, a new machine was purchased for 72,000. On 30th June 2024, machine purchased on 1st January was sold for 48,000 and another machine was installed for 90,000. Rate of depreciation 50% on original cost every year. That means what? SLM. Show machinery account from 1st July 2022 to 31st March 2025. From where to where? For 5 marks. Are you getting this? Now, when did you purchase it? 1st July 2022. What year are they following? Calendar year or financial year? Are they following calendar year or financial year? No, they are following financial year because they said 31st March 2025. So, on 1st July, what has happened? They purchased a second-hand machinery for 1,20,000 and it became 1,38,000. 1,38,000. Clear if you see? Where are we? Here. Can you see 1,38,000? I don't know why 2 times. Totally once only you can write 2 bang 1,38,000. And in that year, has anything happened? 22-23, has anything happened? Nothing has happened in 22-23. Next, whatever has happened, one more machinery is purchased for 72,000. Now, listen to this. See the fun part. This asset is purchased on 1/1/2023. This one is purchased on 1/7/2022. And both the assets we are following straight line method only. But straight line method, what percentage did they give us? The percentage that they have given us is 15%. So now just be careful. 1,38,000 into 15% into 6 divided by 12. Do. 10,350. What about this asset? 72,000 into 15% into 3 divided by 12. 2,700. 2,700. What is happening over here? Huh? Oh, July. 9 months. 9 months, guys. 1,38,000 into 15 into 9 divided by, how much is it? 15,525 plus 2,700. Are you getting 18,225? Now, WDV, is it relevant for us or irrelevant for us? Is the WDV relevant or irrelevant? WDV is irrelevant because we are calculating on SLM. So always remember that these are the costs which we need to calculate the depreciation. Now next year, 1 year done. 1 year done. When we go to the next year if you see the question, okay, something happened on 30th June 2024. The first year was what? First year was 22-23. 22-23 done. In 23-24, actually nothing has happened because this is on 30th June 2024. 30th June 2024. That means 23-24 is a blank here. What you are going to do? Just calculate depreciation. But depreciation on what? Original cost. So 120, 18 and 72. What is the total of 120, 18 and 72? 2 lakh 10,000 into 15%. 31,500. Can you see over here? Okay. That year got over and you just carry the balance down. Okay. You carry the balance down. Last year what is going to happen is sale. Okay. Which asset is sold? Now see. 30th June, machinery purchased on 1st January 2023. 1st January 2023 means the second machine which is purchased. 72,000 wala machine. Okay, it is sold for how much? 48,000. And another machine was installed for 90,000. That 72,000 machine, first year, how much depreciation we have removed? 72,000 into 15 into 3 by 12, right? It was 2,700. Clear? Shh. Second year, how much depreciation you have removed? 72,000 into 15%. 10,800. Full year depreciation. Third year, when did they sell it? 30th June. So third year it is going to be 72,000 into 15% into 3 divided by 12. 2,700 here again. What is the WDV now? 55,800. This is the WDV. Sold for how much? Sold for 48,000. So can we take it as 7,800 of loss? 7,800 is your loss. Is it clear, guys? Now, go to your this thing. Can you see 7,800 loss sitting here? Can you see 48,000 amount here? And can you see the depreciation till the date of sale 2,700? Yes. And they have purchased one new asset for 90,000. And when is it purchased? 36. So on this new asset, 90,000 into 15% into how many months? 36. That means 9 divided by 12. So 90,000 into 15% into 9 divided by 12. Are you getting 10,125?
Yes.
Now, what is the other depreciation that we have to calculate? One machine got sold. Which one got sold? This one got sold or 72,001 got sold? 72,001 got sold. So this 138 one is still there. So you will do 1,38,000 into 15%. Is it 20,700 plus 10,125? Are you getting 30,825? And whatever is there, it's balance carried on. Is it worth it for 5 marks? Yes. In fact, they gave you more work for 5 marks than what they usually give for even 10 marks. Now, again, highlighting the important things in this question. It is straight line method. Okay. This, no problem. Just be careful about the months. Shh. How do we understand that it is financial year? They told at the end of the question that it's 31st March. So that's how we get to know it is financial year. Even though the asset is purchased on 1st July. After that, second year is blank year. Nothing happened in second year. That's just waste of time. But you have to do it to reach the third year. Okay, third year what happened? We sold the asset. Which asset we sold? The asset which is purchased for 72 is sold. So you have to calculate depreciation, remove the depreciation for second year, find the WDV on the date of sale, and then only you will reach the end of the year. Is it clear? Are you following this? Yes, that's it with this question, and we are done with depreciation. Next, we need to move into inventories. What? That I have not watched. I heard feedback. This thing is not good. Reviews are not good. Which? But so from so is too good. Next level. Yeah, comedy. Hardly any horror. Yeah, horror comedy. Is it? Which one? Which one? Which three? Which one? Mangalore, Udupi. You never seen. When did you pass out of that place? When did you come out of that place?
The hostel was not good.
How many years you were there? Only 1 year you were.
First year we got
That is after 2023 you went there. That is which year? 2024.
this year April I came.
Last year April I left from there.
Oh. Because you thought now. Those are past 1, 2, 3 members. Ramya Rao.
Yeah. Okay guys, let's start. Shh. Let's begin. Welcome back. Inventory, good morning, yes. Now, inventory, right? It's a very small unit. Okay. Rough weightage around 5 marks in the exam, 5 to 8 marks. That's the maximum weightage that you can get from inventory. So what I would suggest you to do in inventory is go through the concept and go through 4 questions. I mean, obviously you have to study the chapter, but the 4 questions are SM, practice question 1, 2, 3, 4. Inventories, go through the concepts and the 4 SM practice questions, that is 1, 2 and 3 and 4. Okay, that's more than enough. Because those are the 4 tricky questions which keep repeating in the exam whenever it is tricky inventory question. Yes, let's begin with inventory. Very simple chapter. Okay, very simple unit. Let's begin and try to finish it soon. After inventory, we have to go into bills of exchange. After that, we have to go into final accounts. Yes. Let's start. Inventories. Again, I'm not letting anyone in. Don't let anyone in after this, okay? This is like what, in our hometown, right? We come tomorrow. Close the door. In our hometown, right? We have a lot of agriculture and all. Okay, in agriculture, what happens, everywhere fields, all around city, village, it is fields. So in the morning, you leave the cows. And the cow will go. Okay? When they go, all the cows will go together. But when they come back, right, the cows don't come together. One will come, all will reach. All will reach back. Okay, one will come after 10 minutes, one more will come after 20 minutes. Like that, one more will come, then one cow will go little. Okay, like that. So I have that feeling. When giving the break, all are going together. Then coming back like cows, one by one, all are coming slowly. Huh? Literally it is like that. All the cows, they know the way home. Some will come after it is dark. Some will come at 5 o'clock itself. If you know, you know. Okay guys, let's start. Welcome back. Inventory is very small chapter. What is inventory, by the way? Stock. Correct? You call it as stock. This is what you deal with. Inventory is what you deal with in your business. If you are furniture business, if you're doing furniture business, then furniture is inventory for you. Everything else, that is for everybody else, furniture is asset. If you're doing computer business, computer is inventory for you. For everybody else, computer is asset. Clear? When you're talking about inventory, first thing is raw material. Okay, in raw material is nothing but the material that you're using to produce the ultimate product. So material used in production of goods. So to get your finished goods, what you're using, that is called as raw material. That is called as raw material. Is it clear? Now, work in progress means what? Not that side also, not this side also. Okay. Work in progress, semi-finished goods. It's not raw material. It has gone from raw material stage a little forward, but it has not reached the finished good stage. That is called as work in progress. Clear? Last thing is called as loose tools. What is loose tools? Spares to be used in the maintenance of machinery. Now you have one machinery over here. Okay, wiring that is. Okay, you have one machinery over here. This machinery which is there, it will be running 24 hours, correct? But people will come and go. People will come in parts and go, but machinery will be running 24 hours. Now when the machinery is running 24 hours, tell me one thing. Okay, are there some spare parts? We always keep it ready. If machinery requires some maintenance, quickly we'll put those spare parts and we'll replace those spare parts and we'll repair those repair that machinery. Such ones are called as loose tools. Now you're like, sir, wait, loose tools, then it should become fixed asset. No, sir. If it is going to give you extra benefit, then it will become fixed asset. Otherwise, it will just be maintenance related asset, that is loose tools. Clear? Are you following this? What is finished goods? Completed goods which are unsold. This is your main product, no? This is what you're trying to reach. Because you wanted to reach this, from here you started, reached work in progress, and from there the work in progress became finished goods. Now, loose tools only theoretically, exam related problem solving, loose tools are not going to bother you. Clear? Now, valuation of inventory. There is only one rule. Cost or NRV, whichever is less. Cost or NRV, whichever is less. Now, cost. What is cost basically? Cost of purchase plus cost of conversion plus other cost. What does it mean? Now imagine, I am purchasing the machinery, I am purchasing the goods from Spain. From Spain I am purchasing the goods. Okay, I am putting the goods onto a ship. Okay, I am putting the goods onto a ship and that ship reaches the port. From the port, the goods are going to be put onto a truck and the truck will reach my factory. Correct? Till the goods reach my factory, no, from here till here, whatever expenses are there, those are the expenses which are required, other cost. Those are the expenses which are called as other cost. What is cost of conversion? I got raw material. I am going to convert the raw material into finished goods, right? When I am going to convert the raw material into finished goods, I have to put some more expense on that. I have to put some more, some workers will come and work on that. Direct material, direct labor and all will be there. That is called as cost of conversion. Basically, whatever you spend to make that material ready, to make that product ready, that is called as cost of the goods. That is the cost of the inventory. Cost of purchase means what? Whatever you have spent on purchasing. Cost of conversion means what? Whatever you have spent on converting it from raw material to finished goods. Is it clear? Now, what is NRV? What is NRV? Yes, full form is correct. Net realizable value. What does it mean? Today, if I go to market, what will I get? Which value? Huh? Present market value. Today, if I go to market, what will I get? Estimated selling price. But to go to market, I have to first complete the product. So, estimated cost of conversion. After I go to the market and sell it, to sell, I am only not going, I am selling my selling person, that is salesperson, estimated selling expense, remaining amount, whatever is there in my pocket, that is called as NRV. Is it clear? Now understand this. Today I have a chair, I am manufacturing chair. Okay, I have a chair. I have a chair. Can I sell this? Can I sell this? Can I sell this? This, who will sit on this? If I sell this, it will become like this, no? Is there one leg, guys? Leg only is not there. Can you see here? Okay, that means can I call it as work in progress? But I know that whenever I complete this chair, I can sell this chair for 500 rupees. But to put this one more leg, I have to spend 50 more rupees. So that means out of 500, 50 went, I am left with only 450. But then to sell it, I have to give to an agent. He will take another 20 rupees from me. That means I'm left with how much? Only 430, and that is called as my NRV, net realizable value. Is it clear? Now, methods. We have multiple methods in inventory valuation. First one is called as FIFO. What is FIFO? First in, first out. That means whatever material comes first, it is assumed that those materials are going to go out first. That means what will remain? Whatever came last. Your closing stock will be what? Whatever came last. So FIFO, first in, first out. Therefore, closing stock is last in. Okay, LIFO, there are no questions on LIFO. Okay, 99% they have stopped using LIFO because LIFO doesn't make sense most of the times. You know why LIFO doesn't make sense? Last in, first out. That means whatever came first will always remain. That means it'll get spoiled. Are you getting my point? Imagine I'm selling this thing, idli. I'm selling idli. Last idli I'm selling every time. The hot idlis I'm selling. Whatever was manufactured in the morning, right? It is there only. Are you getting my point? Whatever was manufactured in the morning, that is gone. Because last in, first out, last in, first out, last in, first out, the first in will remain like that only. So most of the times LIFO doesn't become applicable or is not making sense. That's why they don't follow LIFO. And I don't think in your study material there are any questions on LIFO. There are only questions on FIFO and weighted average. Clear? Just to explain the method, they would have told LIFO, but otherwise only FIFO and weighted average. So LIFO is last in, first out. Average price method means what? Closing stock will be valued at average price. That means if I tell I purchase 100 units at the rate of 10. I purchase 50 units at the rate of 5. So now if I calculate, my average price is 10 plus 5 divided by 2, that is 7.5. So all my valuation, okay, that is closing stock will be valued at average price, 7.5. Average price is total prices divided by number of prices, which is totally baseless. Average price method doesn't make sense at all. You know why? Imagine I have 1000 units at the rate of 1. I have 1 unit, okay, 1 unit at the rate of 10,000. Now what will I do? I'll do 10,000 plus 1, 10,001 divided by 2, that will become 5,000.5 or roughly 5,000. So basically everything will be valued at 5,000. Even this 1,000 units also will be valued at 5,000. It doesn't make sense at all. It's 1 rupee per unit. So the benefit of this shouldn't go into this. So average price method also is only in books, not theoretically applicable. What is really applicable is weighted average price. What will you do in weighted average price? You'll tell 1000 into 10. Okay, my total cost is, 100 into 10 total cost is 1000. 50 into 5 total cost is 250. So my total value is 1250. But total units are 150. So 1250 divided by 150, I'm telling 8.33 is the weighted average price. Is it clear? Are you following this? Now weighted average price method is closing stock valued at weighted average price. Weighted average price is total value of stock. Total value of stock divided by total quantity. Do you remember in study material you have those questions where you'll write date, then issue, purchases, issues, closing balance. Okay. So every time you see the closing balance, if it is weighted average price, closing balance will be at weighted average price. If they tell average price, closing balance will be at average price. If they tell FIFO method, closing balance will be as per FIFO method. Clear? Now, COGS and gross profit computation. Do you know what is COGS? What is it? Cost of goods sold. Cost of goods sold. And gross profit computation. Can we use just trading account to find it? If I use my trading account, I'll get gross profit. I'll get gross profit. And what is the formula for gross profit? What is the formula for gross profit? What is the formula for gross profit? Sales minus cost of goods sold. Sales minus cost of goods sold. What is cost of goods sold? Opening stock plus purchases plus direct expenses minus closing stock. Opening stock plus purchases plus direct expenses minus closing stock. Did you just get cost of goods sold from trading account itself? And sales minus whatever just you computed is actually your gross profit. So it happens the same way even in your trading account. Even in trading account, the methodology is same. Clear? Now, let's try to understand the gross profit computation. Cost of goods available for sale. This opening stock plus purchases plus direct expense can also be called as cost of goods available for sale. Now, some of you have this problem with understanding the percentage itself. In inventory question, you will mess up the percentage itself. They would have told 20% on cost, but you would have taken on sales. Clear? Now, gross profit percentage computation, cost is 100, gross profit is 20, selling price is 120. Now, if I tell you on cost, how much it is? 20 by 100, 20%. On sales, how much it is? 20 out of 120, that is 16.67%. If you anytime have doubts on this, okay, just refer this. See, gross profit on cost is 25%. That means on sales, you're going one step forward now. When you're going one step forward, gross profit on sales will be 25 by 125, 20%. Gross profit on cost is 50%. You're going one step forward now. It will become 50 by 150, 33.33%. Gross profit on sale, 20%. Now you're coming one step backward, 20 by 80. Okay, when you're going forward, you would have done 20 by 120. Now you're coming one step backward, 20 by 80. Is it clear? And gross profit on sale is 25%. That means gross profit on cost is how much? 25 by 25 by 75. Is this clear? This is how you're going to understand. Now, simple. Why do you need to do all this, circus, sir? Why all this is required? If a question is that, simple. If gross profit is there, okay, percentage is there, and the amount given in the question is sales, but the percentage is on cost. So you have to convert the percentage, then you have to apply it. If the gross profit percentage is on cost, on sales, but the amount in the question is cost of goods sold. So when you apply it, what you have to do? You have to convert the percentage and then apply, then only you'll get the correct answer. Are you getting this? Yes. Now, inventory maintenance system. Okay. How are we going to maintain inventory? First one is called as periodic inventory system. Other one is called as perpetual inventory system. What is periodic inventory system? Simple. I am too lazy. When I want to calculate periodic, when I want to know the closing stock, I'll close the door and I'll start counting. I will start counting. When I finish counting, right, whatever I get, that is called as the closing stock. Closing stock computed by physical counting. Correct? Now, stock can't be counted whenever we want. Revenue loss on counting day. Can you count whenever we want? Stock, can it be counted whenever you want? It is not possible, because if I count, I have to close the door over there. Because if I keep the door open, I'll tell you what will happen. If you keep the door open, you will start counting from here. And your workers will be working. They'll remove the goods from here, which you already counted, and they'll sell it off. Then when they purchase, they'll come and keep the goods over here. So you'll be counting, but behind whatever you have already counted, that has gone out or come in. Are you getting my point? So whenever there is periodic inventory system, that means you're doing physical counting. When you're doing physical counting, what you're supposed to do is you have to shut the business. And if you shut the business, one day you will have revenue loss. Revenue loss will be there on that one day. Now, perpetual inventory system. What is perpetual inventory system? What is perpetual inventory? I want to know the closing stock. Whenever I ask you, I need to know the closing stock. So I'll tell one guy, stand at the door itself. Goods came in, enter. Goods went out, enter. Today evening, if I ask you the closing stock, it should be there in your sheet. Next day, goods came in, enter. Goods went out, enter. If I ask you anytime, there should be closing stock. Now remember, you are making that questions where you prepare purchases and all that. This is periodic inventory or perpetual inventory? Is it periodic inventory or perpetual inventory? It is perpetual inventory because you are preparing on day-to-day basis. Are you getting it? For periodic inventory, there is nothing to be prepared. You just go count. That's your closing stock. You go and count. What you find, that is your closing stock. What you don't find, you assume that it is sold. Are you getting my point? Now, understand this. In inventory, by default, we will have to learn some things called as consignment. Why? Why we have to learn consignment? So consignment was there in old scheme of CA Foundation. It is removed, but still we have to learn it. You know why? Because it can impact some of the inventory questions. Now, what is consignment? Let's say we have one guy called Chetan over here. Okay, who is the consigner? Where we have one more person called as Mohit, who is the consignee. What does it mean? One person is sending goods to another person. Who is the owner of the goods? Consigner. Owner of the goods is consigner. Clear? What is consigner doing? Sending the goods to Mohit. Sending the goods to Mohit as an agent. That guy is agent and telling him sell. Whenever you can, wherever you can, sell it. When you get the money, give it back to me. When the money is received, sends the money after the goods are sold. Clear? Now, on the balance sheet date, if goods are sitting in Mohit's go down, whose goods are there? Mohit's goods or Chetan's goods? Chetan's goods. But where is it sitting? Mohit's go down, but still it will be shown as closing stock in Chetan's balance sheet. Because who is the owner? Chetan. So on balance sheet date, goods unsold, owner is consigner, so it should be there in Chetan's balance sheet. Now tell me one thing. It is there in Chetan's balance sheet, but when I count, will I find it? Will I count? When I count, will I find it? No, when I count, I'll find only what is there in my factory. But if I take my total closing stock, what is there in my factory, plus what is there in Mohit's factory, which belongs to me, that will be my closing stock. Is it clear? The concept of consignment. Now see over here. Closing stock of consigner. Closing stock at own premises plus goods unsold at consignee's go down. Closing stock which is sitting over here plus goods which are sitting over there which is unsold. Are you getting this? Yes. Sale of goods on approval or return basis. We have already discussed this. We'll go through this again. If goods are not accepted or rejected on balance sheet date, what you have to do? Reverse the sale entry and also add it to closing stock. If you are adding to closing stock, then when you are calculating inventory, closing stock will increase. Now, same logic. Where are the goods? Is it in my go down? No, I gave it to somebody and I told accept or reject before this date. But they did not accept or reject before this date. Now that they have not accepted or rejected before this date, now I will reverse the sale entry and I will pass the closing stock entry. But where are the goods? Still sitting over there. But who is the owner of the goods? Me. Who is the owner of the goods? Me. So in my balance sheet, when I tell closing stock, the goods which are here plus goods which are there, which are still not accepted. Is it clear? Yes. Now, adjusted selling price method. There is like one question or two questions on adjusted selling price method. Okay. I don't think it's ever asked. Forget not asked in recent past. It is not asked ever. So it becomes important. One question is there. Just go and see. Now here what they have told, closing stock will be mentioned at selling price. Usually closing stock is at what price? At what price? Cost price. Here in adjusted selling price method, they are telling it at selling price. Now from the selling price, if you remove the profit, what will you get? Closing stock at cost. Are you getting my point? Closing stock will be there at selling price. Remove the gross profit from that. You will get the closing stock at cost. That time, how to get the gross profit percentage? Gross profit divided by sales into 100. Okay, I'm not sure about the question numbers, but there are a couple of questions in the study material for this particular topic. Okay, rough weightage of inventory in your exam can be around 5 to 8 marks. I think in the last few attempts, consistently they are asking for 5 marks. Always they are asking for 5 marks. Clear? So, what I want to do is actually solve 4 questions. 4 questions which you love. Okay, the SN. Practical questions. At the end there are 4. Okay, do you remember those questions? Beautiful there. One is better than the other. Nothing is similar. One is better than the other. Okay, so let's go into inventory. See, these questions I'm not solving in marathon, okay? You should be able to do this. Do the receipts, put the issues, you'll get the balance. Which method it is, you have to follow. Okay, let's go straight into, yes, 4th one. Fourth one. Clear? Now, understand this. Each question is unique. Each question is unique, whichever is there in sitting in practical questions. Now, have you ever wondered what is the difference between illustrations and practical questions? Huh? No. Examples are there separately in the study material. There is something called as illustrations, no? And there is practical questions. Illustrations are the ones where they are teaching you the concept. And practical questions are the one where they are testing the concept. So if you have ever noticed, practical questions are always a little trickier than the illustrations. And practical questions, whatever adjustments are there, directly comes in the exam sometimes. Clear? Yes. I mean, I don't know about other subjects, but accounts, this is how it works. Now, question number 9. Physical verification of stock in a business was done on 23rd June 2022. What did they do? Physical verification. They did it on 23rd June. The value of the stock was 48 lakhs. Following transactions took place between 23rd June and 30th June. Okay, now if you look, 23rd June we have 48 lakhs. What do they want us to find? Determine the value of stock on 30th June. They could not count on 30th. They counted on 23rd. Then they will do plus minus and they will reach 30th. Is it clear? There are certain questions where they will not be able to count on a particular date. They will count on a future date and they'll come backwards. Here what they are doing, they are going forward. Now first one, out of the goods sent on consignment, goods at cost worth rupees 2,40,000 were unsold. If it is unsold, where is it sitting? Yeah, it is sitting in their go down. That means it should be added to our inventory. Now, you are like, sir, already here 48 lakhs. Isn't it included in this 48 lakhs? Isn't it included in this 48 lakhs? No. Why? Huh? It is physical verification. When I counted, I will not get to know what is there in neighbor's go down. No. They did not tell periodic inventory system or perpetual inventory system. They just told physical verification of stock was done on 23rd June. But now when I counted, I found something. Let's assume I'm doing periodic inventory system. I found this. But what I did not find, that is what is there in consigners go down. But that also is my stock only, no? End of the year, they did not ask, calculate the value of stock in go down. They said value of stock on 30th June. That is what is my total value of stock they have asked. So what is there here? 2,40,000. Okay, it was unsold. That also should be added back. Okay, our stock only. So now can you see added unsold stock out of goods sent on consignment? 2,40,000. Can you find this? Can you see it is added? Yes. Good morning. Purchases of 4 lakh were made, out of which goods worth rupees 1,60,000 were delivered on 5th July. Purchases were made how much? 4 lakhs. Goods worth rupees 1,60,000 were delivered on 5th July. We are trying to find the stock on what day? 30th June. So should I add only 1,60,000, only 4 lakh minus 1,60,000 or full 4 lakhs? Why? 4 lakh minus 1,60,000, 2,40,000 reached. 1,60,000 reached much later. Is it there on 30th June? No. Should I add that to 1,60,000 also? No. Yes. That is the bamboo. Because we don't study only accounts. We also study one more subject called as law. In law, we have something called as Sale of Goods Act. You don't need the goods to reach or go down. It is already purchased. That means invoice is raised. That means it should be taken as purchase. Is it clear? 2,40,000, 1,60,000. See, can you see both are taken over here 4 lakhs? Are you getting this? Did you get it? Purchase are made, right? Now, purposely IC has given no. Now, you know what? These practical questions which are there, right? In the last 4 attempts, 2 times, 2 of them are just copy pasted. Direct questions. Because before the practical questions, they know all silly ones are there. Okay, 2 are direct questions. And out of the 4, I think 1 is that table preparation question. For 5 marks. Table preparation question. Okay, now, FIFO, LIFO, whatever it is. Okay, now, did you understand this? Very important. Purchase of 4 lakhs were made on what date? Whenever. It is made between 23rd June and 30th June. We made the purchase between 23rd June and 30th June. That means all purchase should be added to the inventory. but the goods came little late. Doesn't matter. They are not asking you how much is there in the godown. They are asking you what is the value of the stock. Sale of goods act tells, okay, ownership transfers when even invoice is raised. Clear? Now, next. Sales were 13,60,000, which includes goods worth rupees 3,20,000 sent on approval. Half of these goods were returned before 30th of June 2022. Returned. What should I do? Can you see here? Cost of goods sent on approval 1,60,000 into 80%, 1,28,000. Why is it added? Sales were 13,60,000. Forget about that. Which include goods worth rupees 3,20,000 sent on approval. Half of these goods were returned before 30th June. No, the cost percentage is given here. Yeah, cost plus 25%. No, cost plus 25% means 25% on cost. So on sale it is going to be 25 by 125. 25 by 125 is 20% on sales.
3,20,000 in the top, 1,60,000 minus 20%.
Yes, 1,60,000 minus 20%. See, 1,60,000 into 80% they have done. This is added back to stock. Clear? All these things are added. Now what you have to remove? Only the cost of goods sold. See over here. This we have added because it is our goods which are sitting in consignees godown. This we have added because we have purchased the goods, both of these. Then sale of goods, half of them we have added back because it is added back to my inventory. Now all the things that are added I have considered. Now sales I should minus, but sales I am not going to minus. Cost of goods sold I am going to minus. Are you getting my point? Inventory is calculated at cost, no? If I directly minus the sales includes even the profit. Only the cost of goods sold I am supposed to minus. So now if you see after that in this question only cost of goods sold is there to be computed. What is my sale value? 13,60,000. Remove 1,60,000 from that. That sale of goods on approval basis. So you have only 12 lakhs. You have only 12 lakhs. Now the gross profit directly you can't compute. You can't compute the gross profit directly because see the next line. However, goods costing 2,40,000 had been sold for 1,20,000. That means some of the goods are not sold. All the goods are not sold at this percentage. Some of the goods were sold at loss. Some of the goods are sold at loss. So if you see over here, 13,60,000, from that remove your abnormal sales. What is your abnormal sales? How did we get 13,60,000? Your total sales which was sitting over here. Clear? Out of that, do you agree that 1,20,000 is abnormal sales? Okay, these and also 1,60,000 is returns. Remove these two, that time you will get 10,80,000. These are normal sales. Understand this. I have 13,60,000. From that approval thing I am removing. I have only 12 lakhs. I have 12 lakhs, correct? Out of this 12 lakhs, I have two types of sales. One is normal and abnormal. What is normal? Where I am selling, normal means selling at 20% profit on sales. Selling at 20% profit on sales. It is 25% on cost, 20% on sales. What is abnormal? Anything other than this is abnormal. Anything other than this is abnormal. Can you see I have sold some goods at 2,40,000 but I have sold it at what? 1,20,000. So abnormal sales are 2,40,000. Okay. That means remaining, what is the remaining? 9,60,000 is normal sales. 9,60,000 into 20%. How much are you getting? What? Oh, sorry, 1,20,000. Sold for 1,20,000, right? 1,20,000. So that makes it 10,80,000. 10,80,000 into 20%. That makes it 2,16,000. Did you make profit over here? But did you make loss over here? 1,20,000 loss over here. Why loss? Because we sold for 120, but the cost was how much? 240. So 216 and 120 net we made a profit only of 96,000. That is what 96,000 you are seeing over here. Sales minus profit gives you cost of goods sold. Are you getting this? Sales minus profit gives you cost of goods sold. Why can't we calculate directly? We can't calculate directly because if this sentence was not printed, no. If this sentence was not printed, then whatever sales are there, on that I will directly calculate 25 by 125 or 20%. Clear? But they said, however, goods costing 240 were sold for 120. That means some goods are sold at a loss and some other goods are sold at a profit. So what you are doing, the loss wala goods you are going to remove it, and the remaining goods you are applying the profit percentage. Now you got profit on some goods. Then this loss you are going to subtract. That time you will get your net, whatever you got. Clear? So now when you subtract the cost of goods sold, whatever is remaining is your value of stock. Whatever is remaining is your value of stock. Is this clear? Any doubt with this one? 44,64,000. Are you following? Yes. This is your stock calculation for question number 4. Now, what are the things that you have to remember? If there are goods in consignees go down, that is your stock only. Then goods returned, that is your stock only. Then purchases, you purchase the goods, it didn't reach your go down, but still it's your stock only. It didn't reach your go down, it reached late. They are not asking what is there in the go down. They are asking what is your value of the goods. Okay. And here when you are calculating, we should not subtract sales. We should subtract what? Cost of goods sold. To get cost of goods sold, what should I do? Sales minus profit. But when I am removing profit, there are abnormal sales also. So divide your sales into two parts. Normal sales, abnormal sales. Abnormal sales, we know it is 1,20,000. Cost was how much? 2,40,000. Cost was how much? 2,40,000. That means I sold at a loss of 120. Remaining everything I have sold properly. I have sold it at what? 20% profit. That means 2,16,000. When you subtract this, you will get the net profit, whatever you have made. Not the net profit of P&L, the net profit from my sale. Clear? This is your question number 4. Now, next you have question number 3. Hanuman Limited's question. Okay. Now, this is inventory plus rectification of errors. You thought no, rectification is only for 10 marks. Morning we learned enough. Forget it. Let's ignore it. Okay. Inventory plus rectification of errors. I'll show you again inventory plus partnership also tomorrow. Inventory plus partnership also. So basically inventory can be asked anywhere. Inventory plus final accounts questions are also there. They will tell final accounts questions. We prepared the balance sheet after considering this as the net profit. But sorry, I forgot to put these two things. So again prepare P&L adjustment and then make the balance sheet. Okay, now understand. Go to the end of the question. Calculate the value of stock and adjusted net profit for the year. You have to find the value of stock and the net profit. Okay, one more important question. Profit and loss of Hanuman showed a net profit of 6 lakhs after considering the closing stock as 3,75,000. How much is the closing stock they took? 3,75,000. How much is the profit and loss net profit? 6 lakhs. Now if I go to my calculation, can you see net profit starting point is 6 lakhs? Can you see my stock is 3,75,000? Can you see the stock as 3,75,000? Now all alterations we are supposed to do. Now first one. Purchase for the year included 15,000 paid for electrical fittings of the shop. Electrical fittings are what? Asset. Electrical fittings are what? Asset. I have a tube light over here. It is asset. It is not expense. It is expense only, but it is capitalized expense. Clear? So now this 15,000 should be removed from purchase. By mistake, I have taken it as purchase. When I remove from purchase, what will happen to my profit? When I remove from purchase, what will happen to my profit? Profit will increase. Can you see 15,000 here by electrical fittings? Profit got credited. They are preparing P&L adjustment account. Now only tell me, when are we going to prepare P&L adjustment account? P&L adjustment account is always prepared. It is always prepared. When P&L is already prepared and we are supposed to do some modification to the profit. Clear? That means when there are some errors. Now, next. Hanuman gave away goods valued at 40,000 as free samples for which no entry was made in the books. Free samples, what is the entry? Advertisement account debited to purchase. Now you will be like crazily, you will be mind blown, okay? You will find this 40 here also, 40 here also. You're like, sir, wait. Free samples, we always thought it is advertisement. That means, okay, expense, I am agreeing. Why it is credited also? Anybody has an answer for this? Stock is reduced. Okay. Oh, answer got over. It will affect the profit. Once again, you are on the right track. Stock will reduce. So, if stock reduces, it's actually loss, right? For that we debited. Okay, then why are we credited? Yeah, stock reduces. Debit, right? Then stock increase. By this, again 40,000, why is it added? Closing stock reduces, profit reduces. Closing stock increases, profit increases. Correct? Okay. Now tell me. Now, what they did is correct. I'll tell you what is the reason. Now, understand this. Do you agree this is my trading account? Even if you don't agree, this is my trading account. Clear? After that, do you agree this is my P&L account? Even if you don't agree, this is my P&L account. Clear? This is my trading account and P&L account. Now, here I have purchased some goods. 1,000. I have purchased some goods. If I don't use these goods for trading, I should remove it from trading account. If I don't use these goods for trading, that means I can use it for only two reasons. Either it should be sold. If it is not sold, it should be there in my closing stock. Either it should be sold or it should be there in my closing stock. Is that correct? Now, if I have not sold but I have given it to somebody for free as free samples, do you agree it's an advertisement? So, usually the entry for free samples is advertisement account debited to purchases. So, here I have to write two advertisement. And I have to credit purchases. When I'm crediting purchase, that means purchase has to reduce. Instead of crediting purchase, you can also write on the credit side, it's the same effect. Clear? Are you getting it? Basically, what we are doing it, we are removing from trading account and showing it as expense in P&L account. We are removing the goods from trading account and we are showing the goods as expense in P&L account. Let me tell you, if at all it is 100. Will I do here 1000 minus 100? 900. Will it be 900 that time? Why not? Why is it illogical? We are not using it for? Huh? That's why I'm showing in P&L, no? But I have to remove from purchases, no? That is what I did, right? Oh, that we can do. By what? Off, no chance. It's odd. Offing option is not there. You can change the angle. It's already at 24. Then outside we can sit. It is at the same temperature. Yes, you can make it downwards. Make it fully down, I'm telling you. Full down you make. Full. Is it hitting you? No, right? It will not hit anyone. Is it hitting you guys? Okay, guys. It's a very important discussion. Listen. Did you understand what is happening over here? Entry is advertisement expense debited. Because advertisement expense is debited, it is coming to P&L. 2 purchases. Because I'm writing 2 purchases, purchase is credited. That means purchase is reducing. Basically, expense is expense only. Only thing is, I am removing that expense from trading account and I am putting that expense to P&L account. I am removing it from trading account and I am putting it to P&L account. What I purchased, if I use it for selling, that means it is directly related, direct expense. But if I don't use it for selling and I use it for advertising, then it becomes indirect expense. That's why it is going to P&L. Is that clear? Is it clear? Now, trading is already prepared, no? I cannot go and reduce from trading. No. I cannot go and reduce from trading. So I have to do the adjustment in P&L only. So credit also, debit also, net effect is 0. Are you getting my point? Net effect on profit is 0, no? Now I'll tell you, listen. If I tell you, I have a trading account like this, okay? To opening stock 100, to purchases 1000, buy sales 2000, buy closing stock 500. What is the gross profit? What is the gross profit? 2500, 1400. Clear? Now I am going to my P&L account. This is my P&L account. So buy gross profit 1400 and to rent 200. What is my net profit? 1200 is my net profit. Is it clear? I forgot to put that advertisement 100 advertisement I have not put. Now what will happen? Here I will reduce 100. So this will become 900. So this profit will become 1500. And here I will put advertisement 100. Okay, this will become 1500. And I'll put advertisement 100. This will still remain 1200 only, no? This will still remain 1200, no? So your final profit will not change, no? Only gross profit will change. Only gross profit will change. Your final profit will not change. That is why 40,000, 40,000. It's not going to impact anything. Did you get it? It's not going to impact your net profit. What it would have impacted is your gross profit, which we don't know only what it is. We don't know the gross profit itself. Are you following this? Next. Invoices for goods amounting to 2,50,000 have been entered on 27 March, but the goods were not included in stock. What are they telling? They are telling that there is closing stock. They are telling that there is closing stock. Okay, which we have not recorded. Closing stock we have not recorded. So if I record the closing stock, what will happen to profit? Profit, what will happen? Profit will increase. So can you see by closing stock over here, 2,50,000, profit increases. And closing stock, when I have to take, should it get added to my actual closing stock also? 2,50,000. Are you following this? Profit also increases and my closing stock computation also changes. Next, in March, goods of 2 lakhs sold and delivered were taken in sales for April. March sales were taken in April. Is it a mistake? Yes. Where should it be taken? March only. If I take that, what will happen to profit? Profit increases. Can you see over here sales by sales? By sales. Clear? Next, goods costing 75,000 were sent on sale or return basis at a margin of 33.33% on cost. Though the approval was given in April, these goods were actually, though the approval was given in April, these were taken as sales in March. When did they approve the goods? When did they approve the goods? They approved the goods in April. That means we should not take the goods in March. We should take the goods as sales in April itself. So in March, what do? Reverse the sale, take it to closing stock. Reverse the sale, take it to closing stock. Now 75,000 is the goods, correct? But the sale is how much? 1 lakh. Why 1 lakh? Because 75,000 plus profit. Profit, what did they tell? 33.33% on cost. That means 1 by 3 on cost. That means it is 75,000 plus 25,000, 1 lakh. 1 lakh sale is reversed. When I reverse the sale, what will happen to profit? Profit reduces. Profit reduces, that's why it's debited. But whatever sale is reversed, should we take it as closing stock? Sale of goods on approval or return basis. Today morning when we were doing rectification of errors, we have discussed on the balance sheet date, if it is not approved or rejected, that means we have to reverse the sale. When you reverse the sale, what happens? See, debited. It is debited to the profit. And whatever you reverse, you should take it as closing stock. When you take it as closing stock, what will happen? When closing stock, you put profit again increases. So now again you are taking 75,000 and that closing stock should always be taken as your closing stock. So can you see it getting added to your closing stock also? So your total closing stock is 7 lakhs and your revised profit is 10 lakh 40,000. Is this clear? Did you understand this? These are the things that are going to change. Only 2 things affected our closing stock. What are the 2 things? Purchase, which they did not include, Second, goods lying with customer on approval basis, which we reversed. Okay, because it is going to be accepted in the next month. Yes, that is your question number 3. Question number 2 now. SM. Practical question number 2. From the following information, ascertain the value of stock as on 31st March 2022. 31st March 2022. Clear? Value of stock on 1/4/2021. Value of stock on 1/4/2021 is how much? 7 lakhs. This is the opening stock. Any doubts with this? No. Now, what did they ask you to find out? End of the question. Okay, if you see, at the time of valuing stock, now they have to find the value on what? 31st March 2022. This question, everything is good. It's again that calculation of normal sales and abnormal sales. It is again about normal sale and abnormal sale. Now understand this question 11. See, value of stock is 7 lakhs. Any doubt with this? No. Purchases during the year. What will happen if you have purchases? Will it increase your stock or decrease your stock? Increase your stock. Purchase is also added. Manufacturing expense during the year. What will happen to the value? Cost of goods sold formula. Opening stock plus purchases plus direct expenses minus closing stock. Can you see direct expense over here? That will also be added. Okay. Now, there is a formula. Opening stock plus purchases plus direct expenses minus closing stock is equal to cost of goods sold. Correct? I don't want cost of goods sold. I want to calculate closing stock. So it will become opening stock plus purchases plus direct expense minus COGS is equal to closing stock. Can we see how we just flipped that side, this side? So now here they asked us to calculate closing stock. Opening stock, purchases, direct expense. All three we have already taken in our solution. Can you see all three have been taken? Only thing that is remaining is sales during the period. I can't take sales. What should I take? I should take cost of goods sold. What should I take? Cost of goods sold. See, at the time of valuing the stock on 31st March 2021, last year, a sum of 60,000 was written off on a particular item, which was originally purchased for 2 lakhs. Written off last year only. That means if it was 2 lakhs and I have written off 60,000, now what is the value of that stock? 1,40,000 out of 2 lakh. If I remove 60,000, now the value of the stock is how much? 1,40,000. Clear? And was sold for how much? 1,60,000. This is the cost. This is the sale. So now how much is this profit I have made? 20,000. This is the profit. Is it clear? Now, but for the above transaction. But for the above transaction means what? Except this above transaction, the gross profit earned during the year was 25% on cost. Except this transaction, everything else, we have earned a profit of 25% on cost. How much is my sale? 52,20,000. Is my total sales 52,20,000 over here? Now, I have to divide this 52,20,000 into two parts. One is normal sales, another one is abnormal sales. How much is my abnormal sales? 1,60,000 is abnormal sales because I have sold it at a different rate altogether. So I remove 1,60,000. Now how much I am left with? 50,60,000. 50,60,000. Correct? And that 50,60,000, did we sell at 25% on cost? 25% on cost means 20% on sales. 10,12,000. And here how much profit I made? 1,40,000 goods we have sold for 1,60,000. So I made 20,000 profit. So I add 20,000 over here. This makes it 10,32,000. 10,32,000. That should be my profit. Are you getting this? See, very important discussion. Okay, originally these goods were purchased for 2 lakhs. When was it purchased for 2 lakhs? Last year. And last year only I have already written off 60,000. That means I have removed 60,000 from it. And I told the value is only 1,40,000. Now that 1,40,000 goods, I have sold it for 1,60,000. That means I made 20,000 profit on that. So that is abnormal because something different has happened. Remaining everything is normal. So my total profit should become 10,32,000. Now 10,32,000 if you remove, you will get 41,88,000. This is your cost of goods sold. Can you see the gross profit as 10,32,000? Okay, it has to be computed. Are you getting this? So now 6,72,000 is your closing stock. Any doubts with this? Anybody? Okay, let's go further, guys. Last question from inventory, okay? Question number 12, SM practical question number 1. Now, did you solve one question some time back, which was SM practical question number 4? SM practical question number 4. Did you solve one question? Yes. There also they told you to calculate the value of stock. Now here also they told you to calculate the value of stock. Correct? Now see the fun. Okay, see the fun here. X, who was closing his books on 31st March 2022, failed to take the actual stock, which he did only on 9th April. When did they take the actual stock? 9th April. Future date. Clear? When it was ascertained by him to be worth 2,50,000. What is the value of the stock? 2,50,000. That's the Josh we require, okay? Morning you didn't have that Josh, but I don't I don't know. What you ate in the afternoon? In the class? Oh, that's the spirit, yes. I am always high on energy only. I am the Red Bull with wings. Okay, now listen. Shh, guys, what happened?
It was
Dancing now. Directing. Now where is it going? Tomorrow we should sit there. Problem solved, I'm telling you. Tomorrow we'll sit there, okay? We'll tell them that tomorrow we'll have a class. Huh? Because there no problem at all. You do whatever you want with the AC. There is an AC over here. I'll deal with it. We'll see. We'll check with them tomorrow. Okay, guys. Hello. Good morning. Last question from inventory. Clear? After that, we are going into BOE. Bills of exchange. Very beautiful chapter. Okay. 2 people are there. If you deal with them, over. Chapter done. 2 people are there. You have to deal with them. That's all. Middle bank will come. That's it. Okay. Now, listen. Statement of valuation of physical stock on 31st March 2022. Hello. Sit here. Last question from inventory I'm telling and you're getting up and going. Wait. Now, this is important. Shh. Okay, now tell me, are we going forward in life or are we going backward in life? In this question. In this question only. In life we'll go forward only. In this question we'll go backward. What is the difference between question number 4 and question number 1? Question number 4, they told you the stock on 23rd June and they told you to calculate on 30th June. Here, they're telling you the stock on 9th April and they're telling you to go backwards and tell you the calculate the stock on 31st of March. Clear? So on 9th April, do you agree the stock was 2,50,000? Very good. Now listen. See the fun. It's not that same but same. It is same but different. It was found that sales are entered in the sales book on the same day of dispatch and returns inward in return book as and when the goods were issued back. Purchases are entered in the purchase book once the invoices are issued. What are they talking? Simply one paragraph, but just like the depreciation question where one simply paragraph was there, it was deciding the solution. Same here also. They are telling sales. When are we entering sales in the sales book? When the goods are going. Returns inward. When are we entering in the book? When the goods are which are received back. But purchases, when are we entering in the purchase book? Only when we receive the bill. Invoice. Clear? Sales, nothing to do with bill. When goods go, sales are recorded. Returns inward, when goods come, it is recorded. But purchases, goods might have come also. But if I don't get the invoice, I will not record the purchase. Clear? Are you following this? Purchases are entered in the purchase book once the invoices are received only. Now, it was found that sales between 31st March and 9/4 as per sales day book are 17,200. Sales are 17,200. Should I record this? Goods have gone out, so I should bring it back. Goods have gone out, so I should bring it back. And what is the percentage? 33.33% on cost. That means can I take it as 25% on sales? See guys, I am doing reverse. So if I am going from 23rd June to 30th June, no. When the goods are purchased, I'll add. When the goods are sold, I'll subtract. Now I'm going from 9th April to 31st March. I'm coming backwards. So goods are already sold. Now I have to put it back. Goods are already purchased. Now I have to remove it. Clear? So now the goods are 17,200. What will I do? I should add it back. Goods have already gone out. But I cannot add 17,200. I should add cost of goods sold. So now 17,200 is there. Remove the profit from the 25%. You will get 12,900. Is it clear? Are you following this? Now, next. Purchases between 31st of March 2022 and 9/4/2022 as per purchase day book are 1,200. How much is the purchase as per purchase day book? 1,200. Out of these goods amounting to 500 were not received until the stock was taken. Goods are not received. Goods are not received. But when do they record the purchase? When they receive the invoice. If they receive the invoice, but goods are not received, still we should take it as purchase. Correct, no? Are you getting my point? Remember, in the fourth question, we had the same discussion. 4 lakh and 2 lakh 40. Some people told we should take only 2 lakh 40. But we took 2 lakh 40 also, we took 1 lakh 60 also. Because goods were received in goods were received in July over there. But still entire purchase is of this month only. So we took it in this month. Is that right or wrong? Is that right or wrong? What we did over there? We did it over there. No. Here you see the fun. 1,200 is the purchase, but goods were received until after the stock taking was 500. 500 came later. How much is my purchase? 1,200. How much should I take? 1,200. How much I am taking over here? Only 700. Minus 700. Why? Yes, they asked you to calculate physical stock. There they told you to calculate value of stock. What is the value of stock as per book and what is the physical stock are two different things. What your parents think you are studying and what you are actually studying are two different things. Are you getting my point? Same way, physical stock as per physical stock what is there in the go down and in the books what I am seeing as stock are two different things. Now in the books how much is my purchase? 1,200 or 700? In books it should be 1,200 because I got the bill for 1,200, purchase is 1,200. But what came to go down? Only 700 came to go down and they asked me to calculate physical stock. That's why I'm going to subtract only 700. Why I'm going to subtract? Purchase would have been added to the stock. Now I have to remove from stock because I'm coming backwards. Clear? Next, goods invoiced during the month of March, but goods received only on 4th April amounted to 1,000. Goods invoiced were month of March. When did we receive these goods? 4th April. What did we start with? Actual stock. So what should I do with this 1,000? Minus. Why? It is not there in my go down. Are you getting my point? You are thinking like this. No, it's not there in my go down. What are you talking, sir? Let me tell again. Goods invoiced during the month of March. When did we invoice it? March. But goods are received when? 4th April. March it is already taken as purchase where? In books. But when did it walk into the go down? In April. If walked into the go down in April, what should I do? Whatever has happened between these days, no. That is 1st April to 9th April. Whatever has happened, what should I do? I should reverse it. Goods came in 1,000. I will remove those goods. 1,000. Did you get it? Are you following this? Now see over here. Here I made a purchase of 1,200. In the books 1,200 is there. But what came? 500 did not come. Only 700 came. So I'll remove the 700. Now last month only I made some purchase. But those goods came when? Now. So 1,000 came. I don't want it because I want to go to 31st March. So I'll reverse that purchase as well. So basically simple logic. We are trying to find physical stock. So whatever stock went out, you will add it back. Whatever stock came back, you will subtract it. This is your illustration 1. Practice question number 1. That time you'll get your closing stock. Can you see value of physical stock? And in question number 4, what is told is value of stock. That is why in question number 4, what is there in consignees go down also, I'm still taking it as my stock only. Are you getting this? Yes guys, that's it with inventory. Done with inventory, let's go further. Bills of exchange. Bills of exchange, what are we going to do? First, we'll finish the concept. Then SM4, SM9, and few questions. Okay, welcome back. Oh, welcome back. Good morning. This is our target for bills of exchange. This is my target for bills of exchange. These are the things we have to see. Concept, SM4, SM9, SMPQ3, December 2022 question, 15 mark question, and the last 4 attempt questions. Only that much is required to revise. Okay. Yes, madam. Shall we go? Where? Wherever. You're also in ICU? What is this? You should be full of energy, right? You're in ICU, right? Huh? Yeah, only the non-ICU people are in energy. What's happened to the ICU people? What? We can always do it. See guys, you are already in ICU. You should always be in energy. I'm telling you. What?
Need to be nice.
Hostel food needs to be nice. See, you know what? What? Okay, now listen. Shh. Being in ICU, right, is not a good place to be in. It's not. Forget about the food. Food is not even a criteria. Okay, food is not even a criteria. You should be in a position that come what may, I'll eat. You know why? Because first of all, you're not supposed to be in ICU. Are you getting my point? Okay, I don't want to tell directly, but did you get my point? You shouldn't have been in ICU. You should have studied properly first time. Okay, now when you're in ICU, you should be in high level energy mode. Are you getting this? Because trust me, it's not a nice place to be in. Okay, if you ask me, I wouldn't have gone. Okay, I have been in ICU. Okay, but there was no ICU batch, that's all. Okay, I have been in ICU. There was no ICU batch. I was on ICU on my own. Okay, because failing is not nice in CA. Okay, when you pass, right, you'll experience. When you pass, no, this attempt you will pass, that time you'll experience. When you pass, everybody will be with you. Everybody. When you fail, right, you're alone. Trust me, you're alone. Whatever anybody tells, you're alone. And when you come very close and fail, right, it's even more bad. Because you know that you have studied. Huh? Yeah, that time you'll realize who is fake. And trust me, very small circle is there which is very real. Okay, your Instagram followers might be 1,000, 100 or whatever. Okay, 0, no, not there on Instagram. Okay,
You might have 50K views on one reel.
yeah, you might have 50K views on one reel, but in reality you might have only 3 friends. Are you getting my point? And it is better to actually have a small circle only, because people are tough to deal with. Okay. Huh? Heartbreaks, heartbreak and all should not be there only, man. See, you're a commerce student, right? You know the concept of joint stock company, right? People may come, people may go. Company goes on forever. So there is no concept of heartbreak. This is not the heart that you know. The heart is that one. This is the heart. Now you know why I'm a commerce student. Okay? Because I was drawing like that. Imagine this art also I can't draw properly. What that art I'll do? Okay, so Listen, guys, in my hometown, no, there was one crash course just like this. It was not ICU. It was not called ICU. It was ICU only, but okay, there was a crash course. That is not for CA foundation students. It was for CA inter students. Free stay, free food, free classes. Everything is free. Okay, and food is not like how you are complaining, right? Nobody complained over there. Food is top notch. Okay, in breakfast only there are some 10 varieties. Yeah, and lunch there are like 4 5 different things. Dinner was little mild because dinner you have to have light, right? So it was little light dinner. And at 4:30 break they used to give snacks. No, 4:30 break they used to give biscuit and some tender coconut water and all that during summertime. And 6 o'clock break they used to give proper snacks, bhaji, whatever they used to do, everything proper snacks used to be there. And but the classes were from 7:30 in the morning till 9:30 in the schedule. After dinner, we should still continue. And one day, okay, and I should do it back to back twice. Basically, I have to do it 4 days because there were before 2 subjects for me in inter, accounts and advanced accounting. Then they merged and in new scheme they made it as one subject called as advanced accounting. So I have to do it back to back for 4 days. And every day I'm taking till 12:30, 1 o'clock in the night. 12:30, 1 o'clock in the night, every day. And from 10 o'clock onwards, I have made a deal with them. I'm doing standards. Anybody, after every standard, every topic I'll ask, can we continue? Even if one student tells yes, I'm continuing. And trust me, all the students were telling yes till 1:30 once. And I only felt bad and I'm like, enough. Okay. Enough. And guess what? 1:30 when the class gets over, they are not going. They have a study hall. They are sitting there till 3:30. Then they're studying, going and sleeping, getting up again at 7 o'clock and studying. They are doing this for 15 days. You know why they are doing it? You know why they are doing it? Because the criteria for choosing for that crash course now, they only pick some 30-35 students. Okay. The criteria for choosing is only people who have failed multiple attempts. Only people who have failed multiple attempts. First attempt people and all, they are not taking them. If you have failed once and all, they are not taking them. So who are there over there are the people who have failed 4 times, 5 times and all. Minimum. 3 times is like bare minimum. Otherwise they are not taking. So now they know the pain of failure. There is no sleep, guys. What sleep? When you have seen the pain of failure, right? There is no sleep. They are not feeling sleepy. At 1:30 you feel, no, I leave them and they'll go and sleep. No, all will be there in the study hall and studying. And then they'll go and sleep for some 3-4 hours. Then they repeat the cycle. Around 85% of them clear from that place. Okay, 15% whoever did not clear, eventually they clear. Maybe next attempt or next attempt. Okay, now many students who are in first attempt and all, no, regular batch, they used to tell, sir, even we want to go there, sir. Crazy, right? Very good food, nice stay. Okay, even we want to go. I used to tell them, your goal should be to not go there. Just for food, you don't go there. It's a very bad place to be in. Your goal should be to not go there. So therefore, okay, this moral of the story is, okay, we have to be alert when doing bills of exchange. In bills of exchange, different people will come in your life. There will be one Bob. There will be one Don. All of them will trouble. Okay, but still we have to withstand that trouble. Is this clear? Yes. First we'll go into the concepts of bills of exchange. Okay, bills of exchange. Online students, are you there? There are 20. Yes, sir. Huh? Is it? Last time there were a few. Oh yeah, see, they're also there. Yes. I can see on the chat. Okay, guys. Okay, the moral of the story is basically you have to work hard. Okay. Is CA an easy course? No, not at all. Okay, nothing is easy in life. CA, is it an easy course? No, not at all. But when you're in 10th standard also was not easy. Now if I ask you, you will tell Bakwas course. If your cousins and all ask you, will tell, hey, why you are studying? Nothing is there in 10th standard. But when you're in 10th standard, you studied. Clear? 12th standard, now if I ask you, you will tell stupid. But when you were in 12th, you have worked hard. So when you are at any stage, it is It is hard only. If you ask me for CA foundation, I tell it is stupid. Because I finished, right? If you ask me CA inter, I tell it stupid. Okay, but if you ask me CA final, I'll still not call it stupid. Okay. I don't want to go there. CA final, I'll still not call stupid. I still have immense respect for CA final. Okay. CA inter and CA foundation, I feel I can still crack it. Okay, I don't have to like work too hard to crack it, I feel. I can still crack it. But CA final, I feel maybe, maybe not. If I go back and write and prepare, maybe I might not be able to crack it yet. Again. So I don't want to go there. Okay. Done, no. Still. See, your name, no. You have to make it longer. Okay, your name, your parents kept it, right? You have to add some value to your name. Only 2 letters you add. CA? What did you have for lunch, man? Did they mix anything? Before lunch, this guy was not like this. After lunch, he has become like this. Now see, this course now has immense value. You might read a lot of news and people might tell that value has gone down, that this all that bakwas. Yesterday, I got a message from one of my old students who cleared. She said, sir, I went to the ICA campus. They have a campus placement, ICA. I went to the campus. She got a 20 lakh package. 20 lakh initial package. What's wrong? Where did the market demand go down? 20 lakh package. Where did the market demand go down? It's not a bad salary to start with. Even if you start with 12 lakh package, it's not a bad salary. 1 lakh per month. Are you getting my point? It's a good salary only. But she got a 20 lakh package. Even I was surprised because everybody was telling market demand is low. Market demand is low. Simple. You're economic students, right? Demand and supply, you know, right? Clear? What is the population of our country? 140 crores. Okay. 140? More than how much? 146, huh? Oh, just increased, huh? Oh, again increased. As we talk, it is increasing, right? Let's round it off. So that's why we'll take it as 140 crores. 140 crores, guys. 140. Clear? Now, what is 10% of 140? Huh? You are using your phone, huh? Pass your phone. Okay, 145. 5 crores, we'll leave it. Okay. What is 10% of 140 crores? 14 crores. What is 1% of 140 crores? 1.4 crores. 140 crores, 140 crores, 1.4 crores. Let's say 0.1% also it is 14 lakhs. 0.1%. 0.1% of our total population is also 14 lakhs. And the number of chartered accountants that are there are roughly around 4 lakhs. Demand and supply. Demand and supply. Niche product, guys. You are the ones who are going to tell niche product will always have value. What is niche product? Very hard to find. Niche product, 4 lakhs. 4 lakhs out of 140 crores. Membership number might have gone to like 5 lakh or not, but in that many people have died, many people have left the country. The number of active people who are there are only 4 lakhs. Imagine if you are one among that. Let's say by the time you reach finals, this number reaches 6 lakhs. That time this will reach 150 crores. Okay. So don't worry. The rate at, see, you learn in economics and other places and all. The rate at which the population is growing is much faster than the rate at which the chartered accountants are increasing. Okay, so don't worry about it. So if at all you have something like this, you are a niche product. Okay, there is no way there is going to be value loss. Value will always be there. Is it clear? But you have to reach there. That should be your determination. Did you get it? 145 crore. Did you get it? Yes. Bills of exchange. Gandhiji is waiting for us. Let's see what Gandhiji is going to do. Okay. Now, who are the parties involved in bills of exchange? Drawer. Drawer is the person who is going to draw the bill. Okay. Person who draws the bill is called as drawer. What does drawing the bill mean? Just preparing the bill. Drawing the bill means just preparing the bill. Clear? Drawee. Person on whom the bill is drawn. Drawee is the person on whom the bill is drawn. Payee. Who is payee? Payee is the person who is going to receive the payment. Now I drew the bill. I only should be receiving the payment. No, not necessary. I drew the bill. I can always tell, pay it to my dad. Correct? Now when I'm drawing the bill, payer should be this person only, no. But drawing also can tell, I will not pay. Don't worry, my dad will pay it, and he has also signed and told, okay, I am the payer. So drawer and payee, sometimes it is, most times it is same. It can be different as well. Drawee and payer, most times it is same. It can be different as well. Is it clear, guys? Now, let's see the story between Rocky and Pinky. Okay? Rocky and Pinky. Now listen. Yes. Rocky sold goods to Pinky. Rocky sold goods to Pinky. Okay. Now, there is always a doubt in Rocky's mind whether Pinky will make the payment or not. So, he wants to protect himself by having a negotiable instrument which can later be taken to court. If at all payment doesn't come, it can be taken to court. So, what will happen over here? Draws a bill on Pinky. Pinky will accept the bill. Signing and giving back is called as accepting the bill. And what will Pinky do later? Supposed to make the payment on due date. Supposed to make the payment on due date. What is due date? 3 months. That is just in the question. It can be 1 month, 2 months, anything. 3 months is the tenure of the bill. Time period of the bill. When the time period gets over, the payment has to be made. Payment has to be made. Bill drawn after date. Bill drawn after date means the time will start as soon as the bill is drawn. That means date of bill plus term of bill. Bill drawn after sight. Bill drawn after sight means what? Date of bill plus date of acceptance. That means time will start after the acceptance date. Are you getting my point? If nothing is mentioned in the question, no, it is always going to be bill drawn after date. If nothing is mentioned in the question, it's always going to be bill drawn after date. Clear? Maturity date. Maturity date is what? Due date plus 3 days grace. Now in the question, no, they might tell you that it is due date. But all journal entries will be passed by ICA on maturity date. They might tell you due date this happened, due date that happened. But all journal entries will be passed on maturity date. So when you're passing entries, always add that 3 days grace, then only pass the entry. Is it clear? Now, if it is national holiday, previous day. If it is emergency holiday, next day. Why? National holiday is not surprise. You already know when is the national holiday. So directly you will take the previous day as the maturity date. But when it is emergency holiday, that is surprise. They didn't call you and tell you. Later you got to know. So next day. Is it clear? Now, if question is silent, it is built on after date. We already discussed this. Examples. Okay. If the duration is given in months, what will you do? Add the months to the month column and directly you will get the result. Clear? Add the days, 3 days to the day column, that time you will get the maturity date. If duration is given in month, what you are doing? Again, you are adding to the month column and you are getting the answer. If duration is given in days, is 1 month equal to 30 days? Is 1 month and 30 days same? No, they are same but different. Are you getting my point? See over here. Here also my starting date is 1/1/2024. Here also my starting date is 1/1/2024. But here I am taking 1 month. When I add it, it becomes 1st February. Here I am taking 30 days. When I add it, it is becoming 31st January. Can you see the difference? So ultimate maturity dates are different. Clear? Now, 1/1/2024, 60 days. What will you do? You just add 60 days. 1/3. How did we get 1/3? In 2024, it's a leap year. So February has 29 days. So 30 days in Jan, 1st January it is. So 30 more days in Jan plus 29 days in February plus 1st. That means 1st March will become our 60th day. Is it clear? Now, 23rd December. 23rd December they said 1 month. That means if you add it becomes 23rd of Jan. When you add 3 days, it should become how much? Yes, but Republic Day, good morning. Republic Day. I was waiting for someone to make the mistake. Yes, 25th of January is called as Republic Day, guys. I hope you are aware. 3 national holidays you have to remember. One is Independence Day, which just got over. Okay, yesterday. And one more is Republic Day. That is 26th of January. One more you have to remember is Gandhi Jayanti. That is 2nd of October. What is Gandhi Jayanti? Gandhi, who is that? Your neighbor, huh? Gandhi Ji. Gandhi Ji's birthday. Very nice person he is. You don't know him. He had worked so hard. He stayed hungry and he gave you freedom and you are not respecting it. What is it? Lot of things. Behind, when media was not there, he was drinking apple juice. Okay. Huh? Death of Gandhi Jayanti. What is this? Gandhi is such a nice person. What? You're not respecting him. Okay, guys. Shh. Everybody running behind Gandhi only, no? Money, no. In no two is there. Gandhi only, no. What? No black money, white. No Gandhiji, only UPI payments. I don't even know where my purse is, man. Literally, I have to search, I think, in the room. Because the other day I wanted Aadhaar card. I had to search. I never found my purse. Because it's been such a long time, I have stopped carrying purse itself. Because everywhere I am dependent on UPI payment. So if there is network issue and all, I am gone. Yes, in the books of Rocky and in the books of Pinky. What? Okay, now, what happened? Can we continue? Sir, what if they tell 17? What 17? I didn't understand. Which 17, man? 17 days. You'll add 17 days. If they tell 1st January 2024 and they'll tell 17 days, days should be added to the day column and it will become 18th Jan. Plus 3 days grace, it will become 21st Jan. Any number of days, they can tell 3, 4, 5, 6, anything they can tell, no? No, Sunday doesn't matter. But if at all they tell in the question, right, this day is a Sunday, then you're actually supposed to take previous day. You're supposed to take previous day. Current day and age, it actually doesn't make sense only. Because current day and age, you have UPI transactions. Sunday also you'll make the payment. Net banking is there. Sunday also you'll make the payment. But if they tell, specifically if they tell that 21st of January is a Sunday, then I will make this 20. Is it clear? Okay, guys. Very important discussion in the books of Rocky, in the books of Pinky. Hello, good morning. Hello. Madam. Here. You can't see at all without specs? What is the power? Huh? That means you can't see anything. You don't have to tell anything. I understood. Because mine is 2.75. And when I remove, I can still see. But it will take some time to get adjusted. Okay. 10 means... How did it reach 10 but? Rolling phone, yes. That is the Josh. That is the Josh we require. See, I see guys. Learn from them. Regular boys. They are still in Josh. They're like, let's continue. They're telling we'll go all the way till 11 o'clock. They're in full Josh. Huh? 12. No, you have to sleep early. No? Okay, guys. Shh. Now see, at the same time, we are going to discuss in the books of drawer as well as in the books of drawing. At the same time, goods sold by Rocky to Pinky. Rocky is whom for us? Drawer. Okay, if you are selling goods, the entry will be Pinky account debited to sales account. Same way, what Pinky will do, purchase account debited to Rocky account. Is it clear? Now, if bill drawn and accepted, bill should be drawn and accepted, then only there is value for that bill. If bill is drawn, for Rocky it is bills receivable, which is an asset. So bills receivable account debited to Pinky account. For the other person it is Rocky account debited to bills payable account, which is a liability. Is it clear? Now, once the bill is drawn, during the tenure of the bill, you can do 4 things. 1. Keep the bill in your pocket. 2nd, discount the bill. 3rd, endorse the bill. And 4th, give the bill to bank for collection. Bills for collection. Okay, now we'll focus on the drawer. Only Rocky will focus on. If bill is held by Rocky, what should be the entry? No entry. Why no entry? You are just keeping the bill in your pocket. For that, what entry will you pass? Okay, if bill is discounted with the bank. Discounting means what? You can't wait for 3-4 months and all. You need the money now itself. You take this bill and go and give it to bank and tell, please pay me money now. Later on, Pinky will make the payment to you. Clear? Bank will tell, okay, but I'm not your uncle to pay full amount. So I'll cut some charges and pay the amount. Okay, bank has to collect their money also. No. So bank account debited, discounting charges account debited to bills receivable. Clear? Now, bill endorsed to Lucky. Bill endorsed means what? You have some creditor whom you are supposed to make payment to. You don't have money to pay, so you gave this bill only to him and told him that 3 months later Pinky will pay you. Is it clear? So now Lucky is a creditor. Creditor is gone. So Lucky account debited to bills receivable. Creditor also gone. Asset also gone. Clear? Bill sent to bank for collection. Bill sent to bank for collection means what? That means what? I don't have time to keep track of all these dates. Okay, I don't have time to keep track of all the dates. So I took all the bills and gave it to bank and told you keep track of the dates. Whenever the time arises, you ask the person the money, collect the money and put in my account. This is what you saw in BRS. Amount collected by bank. Bills for collection collected by bank. Are you getting my point? You saw it in BRS today morning. So now what's going to happen? Okay, bills for collection account debited to bills receivable. Sir, why are we doing this? Now some bills, I only might keep track of it. Those are still bills receivable. Some bills, they are going to keep track. So what I'm going to do, bills receivable gone, a new kind of asset is born that is called as bills for collection. This is happening during the tenure of the bill. Is that correct? During the tenure of the bill, whatever you do, whatever you want to do, you give it to bank, take the money. Okay, you give it to Lucky and adjust it over there. You give it to bank and take it as bills for collection. Or you just make one paper rocket and throw it like this. Doesn't matter at all. Doesn't matter at all for Pinky. No entry, no entry, no entry, no entry. Are you getting it? Because Pinky has accepted and told, no, come back after 3 months, I'll make the payment to you. Come back after 3 months, I'll make the payment to you. Before that, you go and ask Pinky for anything, she's not bothered about it. What you do with the bill doesn't matter to her at all. Is it clear? So now, so during the tenure of the bill, in the books of drawee, there will be nothing. In the books of drawer, lot of transactions can happen. Now, let's go into on maturity date. On maturity date, what can happen? Only two things can happen. What are they? Bill can? Yes, either bill is honored or bill is dishonored. Bill is honored means what? That means that person is making the payment. Bill is honored means that person is making the payment on the due date. Clear? Now, Pinky paid. Bill honored means what? Pinky paid. If bill was in your pocket, that means bill held by Rocky. Bill was in your pocket. Money is going to be received by whom? You. So the entry is bank account debited to bills receivable account. Pinky made the payment to Rocky. If bill is discounted with bank, who made the payment to whom? Pinky made the payment to bank, and who are you? Rocky, so no entry. Is it clear? If bill is endorsed to Lucky, who made the payment? Pinky made the payment to Lucky. Who are you? Rocky, so no entry. Clear? Bill sent for collection. Who made the payment? Pinky made the payment to bank. Bank will give it to you only. So now bank account debited to bills for collection. Sir, you are having double standards. Some people are like, you are having double standards, sir. Here also Pinky made the payment to bank. You said no entry. But here Pinky made the payment to bank. You are telling yes entry. Why? Because there bank only is supposed to get the money. So when bank got the money, we are not bothered. But here bank is not supposed to get the money. Bank is just an agent. He will collect it and put into your account. So that is why you are getting the entry over here. Is it clear? Now, who Pinky made the payment to anybody. Doesn't matter to Pinky. Pinky made the payment to Rocky. Pinky made the payment to Lucky. Pinky made the payment to bank. Pinky made the payment to bank for bills for collection. Whatever might happen, Pinky made the payment, right? For Pinky, bills payable account debited to bank. For Pinky, bills payable account debited to bank. Is it clear? Now, what is the other thing that Pinky can do? Not pay. Dishonored. Now, tell me one thing. Dishonored. Okay, it's very simple. Dishonor entries. You should learn it in the right way. Then it will always remain in your head. Bill held by Rocky. Bill held by Rocky. That means Rocky waited for 3 months and finally made a call to Pinky. When he called, number was blocked. Clear? That means Pinky is not paying. But if Pinky doesn't pay also, Pinky becomes what in your books? Debtor. Pinky becomes debtor in your books. So Pinky account debited to Bill's receivable. Bill was in your pocket, bill went out, and Pinky becomes debtor in your books because amount is not paid. Clear? Bill discounted with bank. Who is asking Pinky for the money? Bank. When Pinky doesn't pay, what will bank do? They will not even ask us. They will directly take the money from your account. Bank will not ask. Bank will directly take the money from your account. So now, what will we do when we get to know that money went from our account? Immediate call will go to Pinky. So Pinky account debited to bank. Clear? Now, when bill is endorsed to Lucky, who will ask money with Pinky? Lucky will ask money with Pinky. When Pinky does not pay, what will Lucky do? Lucky will start asking us the money. And when Lucky asks us the money, what will I do? I will ask Pinky the money. Is it clear? So Pinky account debited to Lucky. Pinky account debited because Pinky becomes debtor and Lucky because Lucky is creditor. Is this clear? Now, bill sent for collection. Who will ask Pinky for the money? Bank. When bank does not get the money, what will bank do? They will tell we couldn't collect it. We were not in a position to collect it. So what will I do? Immediate call straight to Pinky. So Pinky account debited to bills for collection. Moral of the story is, let the bill be dishonored anyway. Pinky will always be debited. Debit will always be to drawee. Is it clear? This is very important. When you are having a dishonored situation, you should not do for debit. Debit should come immediately into your head. Credit you think. Okay, debit should immediately come into your head. Bill is dishonored. First, what will you do? Immediately, debit will be to drawee. Debit will be to drawee. If bill was in your pocket, credit bills receivable. If bill was discounted, credit bank. If bill was endorsed, credit that endorsee. If bill was given to bank for collection, then credit bills for collection. Now, whatever might happen, in the books of Pinky, life is simple. Okay? Bills payable gone, Rocky is back. Bills payable is gone, but Rocky becomes a creditor again. It is a liability. Bills payable is gone because the time period is over. After that, it's just a piece of paper. Bills payable gone, but there is a person whom I'm supposed to make payment to, that is Rocky. Is it clear, guys? Now, noting charges. What is noting charges? Charges incurred by whom? Anybody. But this is the amount charged by notary public to note the fact of dishonor. Now your bill is dishonored. Now you will take this bill and go to court, right? When you go to court, court will be like get lost. Okay, court will be like get lost, literally. Because how do I know you're really telling it is dishonored? Money might have actually come to your account. You're telling that it is dishonored. So now court has to sit and check your bank statement. So court has to do additional research work. So court is telling, do one thing. I trust one guy. You go to him first. Let him write on this bill that it is dishonored. Then you come to me with that bill. Then we'll file the case. Clear? That one guy is notary public. Notary public is a kind of lawyer. You would have seen every road, you'll find one board called as notary. Clear? Now, amount charged by notary public to note the fact of dishonor. What will notary public do? He'll be like, you get the bank statement. Get the bank statement. Let me check every bank statement of yours. Okay, money has not come. Okay, I write the fact of dishonor is noted. For that, he will charge some money. Now, tell me one thing. If bill is held by Rocky, who is going to notary? Rocky only is going to notary. So, Rocky is going to notary and notary will charge the money. Notary will not wait till later. Okay, so the noting charges account debited to bank account. Noting charges is an expense. Money goes out. So, bank is credited. Clear? But if any expense is recorded, expense will straight away go to P&L. But if it goes to P&L, it will affect my loss. It is not my loss. Why should I bear this money? I will put it on whose head? Pinky's head. Pinky account debited to noting charges. Is this clear? Pinky account debited to noting charges. What will happen in the other case? Noting charges account debited to Rocky. What will happen in the books of Pinky? Pinky will be like, okay, it's my expense, but I will not pay you now. I will pay you later. So expense account debited to noting, expense account debited to Rocky. Is it clear? Next, bill discounted. Who will go to notary? Bank will go to notary and bank will take the money from you. So the entry will be Pinky account debited to bank. Now again, like the previous case, noting charges also always debit will be to Pinky. Debit will be to Pinky. Why debit will be to Pinky? Because she should pay the amount to us. Drawee has to pay the amount. Okay. Bill is endorsed to Lucky. Who will go to notary? Lucky will go to notary. Who spent the money? Lucky spent the money. What will Lucky do? Ask us for the money. What will we do? We will ask Pinky for the money. Pinky account debited to Lucky account. Is it clear? Next. Bill sent for collection. Bill sent for collection. Who will go to notary? Bank will go to notary. Bank will come back and tell that I went to notary, but you have to pay me money now. So Pinky account debited to bank. Is it clear? All the cases, can you see the person who is debited is Pinky, 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 because notary charges should fall on whose head? Drawee's head. Clear? Now, renewal of bill. What does renewal of bill mean? That means person is good, time is bad. Okay, person is good, time is bad. That means the person knows that if I stay quiet, the bill will get dishonored and this fellow will go to court. He's like, I want to pay, but I don't have money right now. So now what is going to happen? More time asked by Drawee. More time is asked by Drawee. Clear? Now, first thing you have to do is old bill should be cancelled. Old bill should be cancelled. To cancel old bill, what will you do? Pinky account will always be debited to bills receivable if the bill was in your pocket, to bank if it was discounted, to Lucky if it was endorsed. Clear? What will the other person do? Bills payable account debited to Rocky. Is this clear? Now, new bill should be accepted. But tell me one thing. Once I trusted, I did not trust, Rocky trusted. Once Rocky trusted Pinky and did not get the money, right? Did not get the money. So next time when Pinky is asking for more time, don't you think Rocky will tell, I need interest? When I need interest, Rocky will tell, I need interest. Two things can happen. Interest can be paid now or interest can be added to the new bill. Is it clear? Interest can be paid now or interest can be added to the new bill. Now, new bill drawn, same as old bill amount. When the interest is paid now. If interest is paid now, receive the interest. What is the entry for receiving interest? It has nothing to do with bills of exchange. You received interest. Entry will be bank account debited to interest account. Clear? And when the other person is paying interest, interest account debited to bank account. Clear? Now, interest amount is settled. So now what will happen? Old bill and new bill same. So again, bills receivable account debited to Pinky and their Rocky account debited to bills payable. Is it clear, guys? Okay. Now, interest is added to new bill. That Pinky is like, see, you trust me, right? My time is not good. What can I do? Okay, I will pay you the money. Add the interest also to the new bill. Later will become dishonored again. But now you add it to the new bill. Okay, so now Pinky has to pay the interest. Pinky account debited to interest account. Here what did you do? Here you wrote bank account debited to interest because you received the interest. Here you did not receive the interest. So debtor account debited to interest account. Debtor account debited to interest account. So here what you're going to do for the other person, interest account debited to Rocky. Can you see the clear differentiation between the two things here? Here interest expense. Here also interest is expense. Here it is paid, so money went. Here it is not paid, so it is creditor. Is this clear? Here interest income. Here also interest income. Here it is received, so bank account debited. Here it is not received, so Pinky account debited. Are you following this? Is this clear? Can we go further? Yes. Okay. New bill drawn. New bill drawn will be what? Old bill with interest. Old bill with interest. So bills receivable to Pinky, Rocky to bills payable. Bills receivable to Pinky and Rocky to bills payable. Is it clear, guys? Anybody has any doubt with this much concept? No. Retirement of bill. I understood. Okay, retirement of bill. See.
New bill with interest receivable later, we can write a bills receivable account debit to Pinky account to interest on bills receivable.
Sorry. This one, bills receivable account debited.
Below.
You will draw. You will
This one, okay. You're telling compounding the entries? Yeah, you can do that. You can combine the journal entries and write, no issues. I'm just giving transaction wise. Here you can write bills receivable account debited. Okay, to Pinky, to interest. Listen, this is your entry. No, bills receivable account debited. To Pinky, to interest. You can do that. You can do that, no problem. Retirement of bill. Hello, madam. Retirement of bill, okay? Yes. Now, retirement of bill means what? Retirement of bill means what? Time is too good. Time is too good. Person is even better. Okay? That means he is paying early. When that fellow paid late, no? When that person paid late, what did we charge? Interest rate. When they are paying early, don't you think they'll ask for some discount? That discount is called as rebate. So, bank account debited. Are you getting full amount? Are you getting full amount? No. So, whatever you don't get, that is a loss for you. So, rebate account debited to bills receivable. Rebate is nothing but bills discount allowed. Rebate is nothing but discount allowed. But rebate, what will happen? They will give it to you in percentage. So, you will calculate rebate for how much time period? How much time period they have paid early. For that time period, you are going to calculate. Is it clear? Now, this side, bills payable account debited to bank to rebate. Why here rebate is credited? Because you are getting rebate, so it is discount received. Is it clear, guys? Next, insolvency. Insolvency means what? After all the circus, that fellow told, I don't have money. You went, yeah, all the circus, yes. Then he told, you don't have money. After that, when you went there, you went and searched. He had given one address, okay. When you went to that address, only empty land is there over there. No building, nothing. So you realize that nothing you can recover. If you can't recover, for you, what is it? Bad debt. So bad debt account debited to Pinky. For that person, what is it? Don't tell me good debt. For them, what is it? Shortage. Shortage is called as deficiency. Rocky account debited to deficiency account. Is it clear, guys? Any doubts? No. Let's continue. Only one topic in bills of exchange is remaining. That is bills for accommodation. Bills for accommodation. What does it mean? I told you, when it is when it is renewal of bill, the time is bad, person is good. Retirement of bill, time is also good, person is also good. You know what is bills for accommodation? Both the people are bad. Both the people are bad. Nobody wants bills of exchange actually. Nobody actually sold goods to anyone here. Now what they saw Rocky and Pinky. That's it. They saw Rocky and Pinky and they saw that Rocky and Pinky are doing all this. Okay, with as if bank knows whether goods are there or not. Without even doing that circus, I'll go to bank and discount the bill and we'll get money for 3 months. We can share it. So now there is one person called as Chetan. One person called as Mohit. Clear? Now what will Chetan do? Chetan will draw the bill on Mohit and tell Mohit, please accept it. Tell Mohit to accept it. Now your question should be, why will Mohit accept it? Because even Mohit has some benefit in this. What? Partner in crime. Yes. Now you woke up. Okay. In entire bills of exchange. Now you woke up. Yes. Accept it. Now. Huh? Kick is increasing. Yes. What is your name? Okay, Charan. What is that mal? Which you had in the afternoon. Because morning he was sober. Afternoon, something. Sasta. What? Who is Rocky? Oh, bills of exchange. I thought you were talking about Rocky Bhai. KGF. Okay guys, let's get back. Online students, see your friends. Their focus is what I'm trying to tell you. Don't misunderstand. What is this? Musical chairs. You went. You came back. She went. When you went, you could take that bottle and go. All good? Yes. Settle down. Okay guys, now listen, bills for accommodation is the last part. After that, we are only going to discuss problems. Yes. Shh. Here. Now I have to put some new rules. You know football, guys. Do you watch football? Is it a nice sport? Amazing, right? Crazy, right? Correct. Now, in football, what happens, lot of time waste happens. Okay. Some foolish fellow will kick the ball outside. Okay. Then ball will go outside, right? What to do that time? Time will get wasted. So the referee, will keep a count of all the time. Okay. Some person will act like he has to go out and he will go out. Okay. Now time will get wasted. So now at the end of 90 minutes, referee will be like +5. Okay. That means 5 more minutes we have to extend. So like that. You understood the moral of the story, right? Yes. Now, bills for accommodation. Hello, Sergi. Good morning. Yes. Bills for accommodation. This can be your compulsory question. Who knows? Compulsory question after true or false. After that Bakwas theory, then what is there? One question will be there, no? Yes, possible. 4 marks. And that 4 marks can be the difference between September and Jan and May and September. Are you getting my point? Reality check I'm giving you. Hello. Sit straight. Now, bills for accommodation is a very important topic. Okay. Now here what happens? Nobody has sold goods to anyone. Now listen and understand this. Chetan drew a bill on Mohit. And this is for 3 months. And the bill is for 50,000. What will Mohit do? Accept it and give it back. Now, what will Chetan do? Take this bill and go to bank and discount it. Bank will give him 48,000. Imagine bank will give him 48,000. As soon as he gets this 48,000, if he is going to keep full 48,000 in his pocket, what is Mohit there for in this story? He will share the money. In this example, I have given the share as equal. It can be 3:1, 2:1, whatever it is. Okay, they have shared the money. 24,000 he has given to Mohit. 24,000 Mohit keeps and 24,000 will be in whose pocket? Chetan's pocket. Both are going to share 24,000. Now tell me one thing. Actual bill was for how much? How much amount was received? How much is the discounting charges? 2,000. If money is shared equally, discounting charges also should be shared equally. So 1,000 will fall on Chetan's head and 1,000 will fall on Mohit's head. So now at the end of on the due date, who is supposed to pay the bank? Who is supposed to pay the bank? Mohit is supposed to pay the bank. Do you agree with that? If Mohit is supposed to pay the bank, Mohit did not enjoy the entire amount. Mohit enjoyed only 24,000, or Mohit's share is 24,000 plus 1,000 discounting charges. So Mohit is ready to pay 25,000. That means who has to pay the other 25? Chetan. On due date, Mohit has to pay bank 50,000. Before due date, Chetan has to pay Mohit 24,000 share of amount and 1,000 share of discounting charges. Is this clear? This is what you're supposed to know. This is what you're supposed to know about bills for accommodation. Now, sir, what about journal entries? Journal entries are exactly what we learned. Exactly what we learned. It's not going to be different. Okay, but one extra thing is, okay, note, at the end of the bills for accommodation question, always, please prepare ledger. Please prepare ledger. Why? To find out who has to pay how much. If at all Chetan and Mohit is there, Chetan will prepare Mohit's ledger and put all the transactions, post all the transactions. If at all Mohit has credit balance, that means Chetan has to pay money. If Mohit has debit balance, that means Chetan has to get money. Is it clear? That is the last stage of bills for accommodation. Note, discounting charges must be shared in the same ratio as the amount is shared. Now tell me one thing. Chetan drew a bill on Mohit. Okay. On the due date, Chetan could not give the money. So Mohit drew a bill on Chetan. Can it happen like this?
Yes.
Yes. Now second bill came into the story. Still, second bill's discounting charges also will be shared in the same ratio in which first bill was shared. Are you getting my point? It will be shared in the same ratio in which first bill money was shared. In the same ratio you will share it. Why? Because second bill came into the story because first bill wasn't settled properly. Are you getting this? Yes. Bills for collection. What does bills for collection mean? Bills handed over to bank for keeping track of due dates. Bank will collect the amount from drawee and bank will charge bank charges for the services rendered. They'll charge some bank charges. This is what you are seeing in BRS. They were telling bills for collection collected by the bank, not informed to the customer. When they collect the money, first of all, they are doing the work of collecting. Do you think they'll collect, come to your house, ring the bell and tell and go back? No, right? They will just collect and put into your account. You are supposed to find out. Okay, that is bills of exchange. That's it. Silly chapter, guys. Nothing is there in this. You'll see the nothing now. SM4. We'll start one by one with the study material questions first. How's it going, guys? Marathon? Fun, no? Marathon. Crazy fun. Crazy. Huh? I told him only that day. Yeah. I told him I imitated you in class. You don't know, Nitin tells you. Crazy, right? Oh, he has not told my AC guys. Regular batch people know it. Okay, guys. What happened? Oh, what did I? What did you saw me today only. What did you imitate? Even I'm curious. Oh, okay. Whenever I pass though, I see these ICU guys, people always, they'll be on their phone. Whenever I pass, I used to keep an eye. I was waiting to take revenge. That's today. Now I'll make all your food digest. Today, whatever you eat now in your PG, you'll find it tasty. You'll find it tasty. You'll find it tasty. That is the motive of the day. Huh? Today? Who is institute? Ask them. Ask them for food. You should not eat chicken and all. What bird it is flying? That's what they said. Why you are catching it and eating? Okay. Oh, they already catch. Okay, guys. Shh. One whistle done. Okay, 2 whistles more, then you are out. Now you are thinking, no sir, already afternoon 1 whistle was done, right? That was for afternoon rice. Now this is for night rice. Okay, guys. Very important question. Very important question. Katrak. Now same Katrak, if you see somewhere in the exam, has been asked by ICA as Karthik. They just change the names. That's it. Now, let's go further, guys. Journalize the following transactions in Katrak's books. Who are you? You are the Katra. Okay, that is Katrak. Clear? Now, full question you are going to think from Katrak's angle. Yes, you are Katrak. Now, Katrak's acceptance to Basu for 2,500. Let's stop there only. Who are you? Katrak. Katrak's acceptance to Basu. That means for you it is bills payable. For Basu it is bills receivable. Clear? Discharged by. That means you are going to pay cash payment of 1,000 and a new bill for the balance plus 50 rupees interest. One entry you have to pass. Okay. 1,000 rupees you will pay and new bill is going to be accepted for the balance plus 50 rupees interest. For you, who are you? For Katrak, this interest is expense or income? Interest is expense or income? Expense. Clear? So now you are going to write, where is it? I'll show you 1 second. Yeah. Bills payable account debited by, this is the old bill gone and 50 rupees is interest expense for you. So interest is debited to, what are you going to pay? 1,000 rupees to cash and new bill 1,550. How did this new bill become 1,550? Even interest got added because you did not pay the interest now. You're going to pay the interest in future. Is this clear? Now, next. G. Gupta's acceptance of 4,000, which was endorsed by Katrak to Mehta, was dishonored. Mehta paid 20 rupees noting charges. Bill withdrawn against check. Who are you? Katrak. G. Gupta's acceptance was endorsed by Katrak. That means Gupta's acceptance. That means for Gupta it is bills payable. For Katrak it is bills receivable. What did Katrak do? Katrak has endorsed it to Mehta. Katrak has endorsed it to Mehta. Who is supposed to pay to Mehta? Gupta is supposed to pay the amount to Mehta. If Gupta doesn't pay, what will happen? Mehta will ask Katrak. Katrak will ask Gupta. But what has happened over here? 20 rupees noting charges was incurred. So what should be the entry here? This is a situation of bill dishonored, but it was an endorsed bill which is dishonored. So now, who has to pay now? Your Katrak in between. For you, this person becomes debtor. For you, this person becomes creditor. Is this clear? So now the entry will be Gupta account debited to Mehta. But they told no, bill is withdrawn against check and all. So one more entry you can pass, Mehta account debited to bank. That means you're going to make the payment to Mehta. You're making the payment to Mehta. Is it clear? But Gupta didn't pay the amount to you yet. Now, next. Dalal retires a bill 2,000 drawn on him by Katrak at 10 rupees discount. Retires means what is there? Retire means what? Paid early, right? If paid early, there should be a rebate, right? Now, bank account debited. You got 1990. Discount should also be written as rebate. Rebate account debited 10 to bills receivable 2,000. Done. Next. Katrak's acceptance to Patel. Who are you? Katrak. Acceptance to Patel. That means for Katrak it is bills payable. For Patel it is bills receivable. Okay, for 5,000. And Modi's acceptance to Katrak. That means Modi has given one bill to Katrak. That means for Modi it is bills payable. And for Katrak it is bills receivable of similar amount were duly discharged. I was holding like this. Bills receivable, bills payable. That's it. Are you getting my point? You are whom? Are you Modi? No. If you are Modi, you wouldn't be sitting here. Correct? You are Katrak. Are you getting this? You are Katrak. So Katrak over here and Modi over here. For you, this one is what? What is coming from Modi is what? Bills receivable. What is going to Patel? Patel, right? Yeah, Patel is what? Bills payable. Now what will happen? You have the power to give this bills receivable. When you endorse this bills receivable, this bills payable gets cancelled. When you endorse the bills receivable is gone from your pocket. So entry is silly. Bills payable to bills receivable. Did you get this Katrak's question? Okay. Yes. That's it. Hello. Where? I will complain to your sister. She's there in Inter, right? Yes, done guys. Did you get this Katrak's question? Next question. SM9. SM9. Question number 9 in SM, study material. Okay. Listen. This is a very, very important question. Okay. It will test you on all different angles also. Okay. Now, go to the end of the question. I didn't tell you the trick, no, to solve bills of exchange question. Always you should see the last line. When you see the last line, no, you will get a reality check of who you are. Okay. Who you are. Give necessary journal entries in the books of Harry, George and Jack. Forget about others. First you are going to become Harry. Who are you? Harry. Whatever happens, you are Harry. Clear? Okay. Don't you wonder what did I take? I am wondering what you are taking. Okay. Now, see, for me, no, simple. Okay. Many people have asked me, like, what's the secret of my energy and all in class? No, not boost. Actually, I don't know. Okay. Now I might be like a very lazy person outside, but in class, no. Some like what is it? Something enters the body. Positive energy. See, I don't know if you believe this, but I have a strong reasoning for it. Okay, you know, in Hinduism, right? You believe that you'll get features of your ancestors. Okay, so my grandfather, right? He was a teacher. Okay, he was a teacher. He used to teach English and maths. Okay, and he was so good in teaching that when once Pope had visited our city, the then Pope, maybe in 60s or something. Okay, the Pope had visited our city. That time they needed a translator, and my grandfather was called as a translator to translate. He was that good. But my grandfather, no, if you ask my dad about my grandfather, he will not have a good opinion, okay, about him. Because he says that my grandfather was little selfish, okay, selfish person. He, like many kids, know whom to focus on. Okay, now 1-2 kids we can focus. The parents will focus, right? They had many kids. My dad was like some 9th kid or something. 9th survived kid, there were 12. Others died in transit. Okay, so 9th survived kid. Now listen. So my dad, if you ask, no, he will not have great opinion about my grandfather because my grandfather is very strict. They used to not eat until he finishes eating. After he finishes eating, all the kids will come and eat. And grandfather is a little selfish also. If at all there are mangoes growing in village, no, in the tree, the good mangoes he should keep for himself. The fallen ones which are soft, he should give to the kids. Okay, he should do that. So now, only person my grandfather has actually treated well is me. When I was a kid, right, when I was 1 or 2 years of age, he died when I was some 3-4 years of age. But when I was 1 or 2 years of age, he used to cut fruits and good fruits. Okay, he used to cut fruits and used to come and give it to me. And all my uncles and my father and all, they were surprised because he has never done it. He has not done it to their kids only, I mean his own kids. So this is the first time he did it, and he was also old, right? So he must have sobered down. Okay, so he did it. So somewhere I feel that it is passing over of the torch. Are you getting my point? Okay, because otherwise there is no reason how I can become a teacher. I tell in my regular class that if I can do it, you can also do it. Okay, there is no reason, but because I believe in Hinduism a little. Okay, so I feel it is something like when he gave me those fruits, it was some passing over of the energy and the torch. So that's why like I took a very different route, but ended up in teaching. Okay, if you would have told my teachers, right, my teachers, that this guy will end up teaching, they would never believe. In fact, now if I go and tell them also, they'll be shocked. Okay, because I was an amazing student. Okay. I was a crazy student because I was a tough student, okay, to handle. So teachers had a tough time. I mean, I made them earn their salary. Okay. I didn't make them get the salary easily. They had to work hard. And they used to go home and regret teaching. That's how I was in school, okay. So, somewhere, something, I met one teacher, okay, on the road. She asked me, what are you doing? I told her, I'm doing the same thing what you're doing. She was like, she was stuck a little. She's like, you're into teaching? I'm like, yes. That's it. There was 2 minutes of awkward silence. After that, even teacher didn't know what to tell. Okay, guys. But teachers always are nice after you pass out. They will always tell that your batch was very good. But when you were in school, they were telling us that yours is the worst batch. Same thing, yes. Sir, your family is like a serial. I have told you only the intro. You have no idea about the other things. Okay, guys. Bills of exchange SM9. Very important question. Hello, madam. Who are you? Harry, yes. Who are you? Harry. Entire question we will be reading 3 times. Entire question will be reading 3 times. First you are Harry, then you will be George, then you will be Jack. No Jill in this story, okay? Now, on 1st July 2022, George drew a bill for 1,80,000 for 3 months on Harry for mutual accommodation. Harry accepted the bill of exchange. Who are you? Harry. So you accepted. That means for you, what is it? Bills payable. So what should be the entry? George's account debited to bills payable. George's account debited to bills payable account. Is this clear? Next, George had purchased goods worth rupees 1,81,000 from Jack on the same day. What should be the entry? No entry. Why? Because who are you? Harry. George and Jack are doing something. Why are you bothered about it? Okay, let's continue. George endorsed Harry's acceptance to Jack in full settlement. What should be the entry? No entry. George is just endorsing the bills payable for you. I told you, right, till the due date you don't have anything to do if you are having bills payable. Next, on 1st September 2022, Jack purchased goods worth rupees 1,90,000 from Harry. What should be the entry for this? Who are you? Harry. So Jack account debited to sales account. Is it clear? Next, Jack endorsed the bill of exchange received from George to Harry. Look at the circle of life. Who are you? Harry. You had accepted one bill and you had given to whom? George. So for you it was bills payable and for George it was bills receivable. What did George do? George endorsed that bill to Jack. George endorsed that bill to Jack. What did Jack do? Jack endorsed that bill back to Harry. So that note which went from your hand took a full circle and came back to your hand only. So now is your bills payable gone? Can you still call it as bills payable? If you still call it as bills payable, that means you're supposed to make payment to yourself. Are you getting my point? Bills payable took a full circle. Now you have to cancel it. The entry will be bills receivable account debited. Okay, now ICA is taking a longer route. You can directly write bills payable here itself. Okay, ICA will write bills receivable. Then they will cancel it in the next entry. Bills payable to bills receivable. Both are right, no issues. Bills receivable account debited 180. Okay, but how much you are supposed to get from Jack? 190. How much you are supposed to get from Jack? 190. Okay. Now, how much did Jack give you? 180 ka bill and 9,000 cash. That means still Jack has not given something. What is that something? 1,000. So bank account debited, discount account debited to Jack. Is it clear, guys? Now, bills payable to bills receivable. See, cancellation has happened. After that, when we go further, okay, settlement of the amount due to Harry. On 1st October 2022, Harry purchased goods of 2 lakhs from George. Who are you? Harry. Harry purchased goods. That means purchase account debited to George. Finally, they said Harry paid the amount due to George by check. I told you, whenever we are at this question, we should always prepare a ledger at the end to find out who has to pay to whom. Now you are Harry. Whose ledger will you prepare? Will you prepare Harry's ledger? No, in your books you won't prepare your own account. You will prepare George's account. Clear? Go and see the first entry. Do you have George here? Debited. Go and debit 1,80,000. Second entry. Do you have George? No. Do you have George? No. Do you have George? No. Here, do you have George? Yes. So you will credit 2 lakhs. Credit is 2 lakh. Debit is 1,80,000. That means what is the net effect? 20,000. Payable or receivable? Payable or receivable? Payable. Why? Because credit is more than debit. Credit is more than debit. Okay, guys. Hello. Credit is more, debit is less. That means you're supposed to make payment. So what will be the entry for paying money to George? George's account debited to bank account. Can you see George's account debited to bank account? Clear? Story done. Story repeat. Take 2. Take 2. Who are you now? George. Who are you? George. George drew a bill for 1,80,000 on Harry for mutual accommodation. Harry accepted the bill of exchange. What should be the entry now? Bills receivable. Yes, correct. Bills receivable, not bills payable. Bills receivable account. Oh, my bad. You're George, right? George drew a bill. They have actually done George with wrong spelling. Okay, fine. Anyways, where is the bills receivable? Oh, they have passed the entry second because it is same date. Okay, they have not formed the order of the question. Bills receivable to Harry 1,80,000, 1,80,000. Clear? And on the same day, George had purchased goods worth rupees 1,81,000 from Jack. Tell me the entry for purchasing goods. Purchase account debited to Jack. 1,81,000, 1,81,000. Is this clear? Next, after that, George endorsed. George, who are you? George. George endorsed Harry's acceptance to Jack in full settlement. Harry's acceptance was what? 181, no? No, it was 180. So what will you do now? Jack's account debited, gone, 181. But what did you actually give? Only 180. 1000 is discount received, which they have written at as rebate. Okay, discount received or rebate. Clear? Next, what happens? On 1st September, Jack purchased goods worth rupees 1,90,000 from Harry. Who are you? George, no entry. Jack endorsed the bill of exchange received from George to Harry. Who is endorsing? Jack is endorsing from what you gave to George. No, Jack is endorsing. So what are you going to do? Nothing. Okay, on 1st October 2020, Harry purchased goods worth rupees 2 lakh from George. That means for you, what is it? Sales. So you'll pass the entry, Harry account debited to sales. And you already know that time that Harry had to pay money to George. So now here in George's books, bank account debited to Harry, same 20,000. Is it clear? Harry passed the entry for payment, no? So George is going to pass the entry for receipt. Is this clear? Now, take 3. Take 3. Who are you now? Jack and Jill went up the hill to fetch a pail of water. Jack fell down. That's very nice, you badge. Okay, let's continue. Okay, now, 1st July 2022. It is like what, they are thinking, okay, no, what, sir? And wound is there. You are putting salt on that wound again and again. The reason why I am putting the salt on that wound, you know what? We should not get that wound again. Are you getting my point? You should learn your lessons at foundation. You should not get that wound again in inter. Okay, you should know what level ICA is expecting and straight away you should go to that level. Okay. Now, 1st July 2022, George drew a bill for 1,80,000 on Harry for mutual accommodation. Harry accepted the bill of exchange. Very, very good. Who are you? Jack. Is there going to be any entry? No entry. George had purchased goods worth of his 1,81,000 from Jack on the same day. Who are you? Jack. You are purchasing goods. So what should be the entry? George's account debited to sales, 181. Clear? Now, George endorsed Harry's acceptance to Jack in full settlement. You are Jack. You are getting an endorsement to you. So for you it is what? Bills receivable or bills payable? Bills receivable. Bills receivable account debited. Rebate account debited to George. Why rebate? Because 181 ka sale I made. I got only 180 ka bill. So 1000 is 100% going to be a rebate. Is this clear? Yes. Next, after that, on 1st September 2022, Jack purchased goods worth rupees 1,90,000 from Harry. Who are you? Jack. You purchased goods from Harry. What should be the entry? Purchase account debited to Harry. Clear? Next, after that, Jack endorsed the bill of exchange received from George to Harry and paid 9,000 in full settlement of the amount due. What did Jack do? Jack endorsed the bill. Somebody had endorsed bill to you, no? You endorsed that bill. When you endorse that bill, you endorse the bill, but that bill is short. You have actually 1,90,000 over here. Bill is only 1,80,000. So what will happen? Harry account debited for 190, gone. Bill is also gone, but that is only 180. You had to pay 9,000. So bank account 9,000. What you don't pay is discount. Happy. Are you getting my point? Did you get it? You have seen this question from all three perspectives. Is it a normal question or accommodation question? Very good. Okay. Very, very good. I like that. George drew a bill for 180 for 3 months on Harry for mutual accommodation. 3 times I read the same sentence. Still people are telling it is normal. In the question only they told it is accommodation. Good morning. What is the time? 6:30. Only that much. Only 11 hours ago we met. Only 11 hours ago we met. It's only 6:30, right? Yes. Now, done. Are you getting this? Bills of exchange 9. Next question is SM practical question number 3. Okay guys, I'm giving you a break. Yeah, because nobody's awake. Except the 3 there's last. Yes, I'm giving you a break. I'm continuing at 6:45 sharp. Okay, do whatever you can, but if you are not awake, yes, let's continue. Next question is question number 15 from Bills of Exchange. SM practical question number 3. SM practical question number 3. Wow. Let's continue. Okay, now listen. Journalize the following in the books of Dawn. Who are you? You are Dawn. Clear? You are Dawn. Now, Dawn. Bob informs Dawn that Ray's acceptance for 3,000 has been dishonored. Who are you? Dawn. Who is informing Dawn? Bob is informing Dawn that Ray's acceptance has been dishonored. That means if Bob has to tell, now listen. Shh. If at all there is an acceptance between Ray and Bob, for Ray it is bills payable, for Bob it is bills receivable. Why will Bob inform Dawn about it? Are you getting my point? If Bob is informing about Ray's acceptance, that means Ray had actually accepted to whom? Dawn. And what did Dawn do? Dawn has endorsed it to Bob. And who is supposed to make the payment to Bob now? Ray is supposed to make the payment to Bob. Ray has not paid. Can you see? Bob informs that Ray's acceptance for 3,000 has been dishonored and noting charges are 40. Noting charges are 40. Bob accepts rupees 1,000 cash and balance as bill at 3 months interest of 10% per annum. Okay. And Dawn accepts from Ray his acceptance at 2 months plus 2% interest of 2% per annum. So both did not pay. First you cancel the bills. So what will be the situation first? Ray account debited to Bob. Ray account debited to Bob. Because whose acceptance? Ray's acceptance. That means Ray has to give me money. And I have to pay money to Bob. Who are you? Dawn. Clear? Now 3040, 3040. Are you getting this? How did we get 3040? Because 40 rupees noting charges is also there. Now, do you agree that I have to get money from Ray? Do you agree that I have to pay money to Bob? Correct. Now, Bob accepts 1,000 rupees cash. That means Bob will accept 1,000 rupees cash. That means I'm giving 1,000 rupees cash to Bob. And balance as bill for at 3 months at an interest rate of 10%. So 1,000 rupees I'll pay. Remaining I will draw a new bill. So now here Bob account debited 3040. And how did you get this 51? 2040 into 10% into 3 divided by 12 will give you 51. Okay, why 51? Expense. For you it is expense because you are going to pay 3 more months later. So expense. Okay, to bank. Why to bank or cash, whatever it is? To cash because you are paying 1,000 rupees and balance will become a new bill. Balance is basically from this 3040, 1,000 went. So it is going to be 2040 plus 51, 2091. Is it clear? Now, what is happening after that? Now, Ray has to be paid. Ray has to give you money. So what Ray has done, Dawn accepts from Ray. Dawn accepts from Ray, not Dawn accepts any bill. Dawn accepts from Ray. So Ray is giving you bill at 2 months plus interest. So now new bill comes, bills receivable account debited to Ray. Ray was 3040. See over here, 3040 both the people. Now interest will be how much? 3040 into 12% into 2 divided by 12. Are you getting 60.8? You can round it off in the exam and make it 61. No issues. And this will be the new bill. Is it clear? Everything sorted with the first one? Okay. Next. James owes Dawn 3,200. Who has to give you money? You are Dawn. Clear? Who has to give you money? James. Now he sends Don's own acceptance in favor of Ralph for 3160 in full settlement. What is this bakwas? Who are you? Don, right? Don's own acceptance in favor of Ralph. Okay, that means for Don, this was bills payable, and for Ralph, it was bills receivable, and this was only for 3160. If this bill which you gave to Ralph, if James is giving you, that means from Ralph it went to James, and James is endorsing it back to Don. But Don has to get 3200, but he got a bill back of only 3160 in full settlement. That means it is going to be discount. Okay, now see this. Bills payable gone 3160. Discount 40 rupees. Why? Where I was supposed to where I was supposed to get 3200, I got back a bill of 3160 and James is gone for 3200. Is it clear? When you were supposed to get 3200, you got only 3160. And that what you got also was your own bill which took one full circle and came back. That's why bills payable account debited. Can you see inconsistency from ICAS side? Same type of question somewhere else. They wrote bills receivable over here and they passed one more entry and they told bills payable to bills receivable. But here they directly wrote bills payable. So both are fine. Is it clear? Next. Don meets his acceptance in favor of Singh. That means Don had actually accepted in favor of Singh. That means for Don it is bills payable. For Singh it is bills receivable. Clear? 4500 by endorsing John's acceptance for 4450 in full settlement. That means John had accepted to Don, and for John it was bills payable and for Don it was bills receivable. And this was 4450 and this was 4500. What did you do? When you had to pay someone 4500, you gave them 4450 and you closed the deal. That means for you it is discount received. Clear? Now you can see that over here, bills payable gone 4500, bills receivable gone 4450, discount 50. Clear? Next, Ray's acceptance in favor of Don. Retired 1 month before due date, interest taken at the rate of 6% per annum. Who is Ray? Who is Ray? Ray's acceptance in favor of Don means they are telling your own story some time back. Can you see you got one bill from Ray over here? Now Ray is paying 1 month early. Ray was supposed to pay after 2 months, right? 3 months. Ray paid 1 month early. Sorry, 2 months only it was. Ray paid 1 month early. So what is going to be the entry when somebody pays you early? This is called as what? Retirement or renewal? Retirement. It is retirement. So now, can you see the entry? Bank account debited. They should have used the word rebate, but it's okay. ICAI. Rebate. Clear? Now, tell me one thing. 3180 into 6% into 1 divided by 12. They paid 1 month early. Are you getting 15.5? 15.5. Is it clear? So balance amount you are going to receive. That's it. See, Don's question, nothing was there. You are Don. That's it. You are the Don in your life. Clear? Done. Are we done? But no. We have some more things to be sorted. That is, first thing is December 2022, 15 marks question 3A. December, 15 marks. December 2022, 15 mark question. Just try to find it first. Yeah, here we go. Okay, guys. Bills of exchange, accommodation of bill situation, December 2022, 15 marks, 3A. Okay. Now, T draws on J, a bill of exchange. Who are you? In the books of both T and J, I'm doing only one. Because other party, it's just going to be mirror image when 2 people are there. When 3 people are there, okay, some will get ignored, some will get created. Okay, I'm only doing in the books of T. Only in the books of T. Clear? Journal entries in the books of T. Now, T draws on J bill of exchange for 1,80,000 on 1st April for 3 months. J accepts the bill and sends it to T. Who are you? T. For you it is bills receivable or bills payable? It is bills receivable. Bills receivable account debited to J. Bills receivable account debited to J's account. Someone is telling, no sir, ICA is the dawn of our life, it seems. Papa man ICA. They don't do anything. That is the problem. They should give marks. Okay, now, who gets it discounted from his banker for 1,72,800? Who is getting it discounted? T is getting it discounted. That means you're getting money, bank account debited, discount account debited, 2 bills receivable. 7,200 is the discount. Now, see over here. T immediately remits 57,600 to J. How much did you get? 1,72,800. This, you have two parties over here, T and J. How much did T send? 57,600. If out of 172,800, 57,600 is sent, 1,15,200 is kept with you, T only. So can I tell that it is in the ratio of 2:1? It is in the ratio of 2:1. Correct? Now, if this is in the ratio of 2:1, whatever discounting charges are there, that also has to be in the ratio of 2:1. Now, out of 180, if 172,800 is removed, how much is the discounting charges? 7,200 is the discounting charges. That also has to be there in the ratio of 4,800 and 2,400. Is that correct? Now, do you agree when T is sending money over here, 57,600, T has to put this 2,400 on that person's head? This is not my take. They should put it on their head. Now, what should be the entry? J has to be debited because J is being given money. J will be debited for this plus this. Clear? This plus this will become 60,000. So now, can you see the entry? J's account debited 60,000, to bank 57,600, to discount 2,400. Why is discount credited? Because here discount was debited. When you're taking that discount and putting on somebody else's head, for you expense reduces. That is why it is credited. Is this clear? Yes, Ayan. Let's continue. Okay. On due date, T being unable to remit the amount. Who is unable to remit the amount? On due date, who has to pay to whom actually? J has actually accepted the bill. Correct? So, and T has gone to bank. That means J is supposed to pay the bank. But J did not enjoy the complete money, right? T has to give the money back. Whatever T enjoyed. So on due date, T being unable to remit the amount, accepts a bill for 2,52,000. On due date, T is telling, see, I don't have money. You do one thing. Okay, whatever I did last time, no, you reverse the order. Okay, you draw a bill on me now, but you go and pay the bank. Okay, otherwise bank will take from me. Because bill discounted and dishonored, bank will take from me. So you go and pay the bank. Okay, you draw a bill on me. And T is accepting the bill for 2,52,000 for 3 months. What should be the entry for this? J's account debited to bills payable. J's account debited to bills payable 252. Is it clear? Now, which is discounted by J from his banker for 2,40,660. What should be the entry for this? Nothing. No entry. Hello, good morning. No entry. Because who is discounting? J. Who are you? T. Are you getting this? No entry. Who is discounting? J. Who are you? T. Something happens in neighbor's house. You are not going to bother about it. Clear? No entry in your books. J sends 40,440 to T. Now understand this. J sends 40,440 to T. How much did they discount for? 240,660. What was the bill amount? 2,52,000. Do you agree? Out of that, T and J. First of all, out of 2,52,000, how much did you get? 2,40,660. 240,660 is what you got. Clear? How much did you give to T? T got only 40,440. Very small amount T got, right? 240,660 minus 40,440. So do you agree that 2,220 was kept with J itself? Okay. Now, when J is giving money, don't you think along with money, he will put something on your head? He will put what? Discounting charges. He'll put the discounting charges on your head. Correct. How much is the discounting charges? 11,340. Out of 11,340, how much is your share? 2:1 na? 2 by 3. Okay. 11,340 into 2 by 3. 7,560. That means 4440. 48,000 falls into your head. When 48,000 falls into your head, little money comes and 7,560 discounting charges also fall into your head. Is it clear? Now tell me what should be the entry? Yes. What is the entry? Bank account debited. Discounting charges debited. Who gave it? J. J's account credited. Bank account debited. Discounting charges debited to J's account. Ignore this, okay? You got the answer, no? ICA has, we have a way of eating like this. ICA will eat like this, okay? Let's ignore it. 7,560. Clear? 2:1 basically. Now, after that, what happens? Before the maturity of the bill, T becomes bankrupt. After doing all the circus, he breaks his leg, okay? And his estate paying 50 paise in a rupee, okay? Half only we are able to get. Now, T becomes bankrupt. First of all, how much do I have to pay to J? If you give me the answer now, right, I will stop the class now. No, you have to prepare the ledger and see. You have to prepare the ledger and see. It is not that straightforward. You have to prepare the ledger and see. Okay, first the bill gets dishonored. Bills payable account debited to J. Why? You had a bills payable, right? Dishonor the bill, then you will be able to calculate. Now, how did you get 50? No, 48 plus 120 it is. Now, how to get this value? Ledger. Whose ledger? T's or J's? J's. If you prepare T's, it would be wonderful because it's your own books. Clear? Now, first entry. Can you find J here? Spot J. Yes. Debit or credit? By and all, I'm not writing. That is in regular class. I'm just filling the number just to understand. Here, is there any J? No. Is there any J? Yes. Debit for 60,000. Okay. Is there any J? Yes. Debit for 252. Is there any J? Yes. Credit for 48,000. Is there any J? Yes. Credit for 252. Is there any J? Is there any J? Yes. Debit for 168. After that, is there any... Oh, wait. Hey, that is the balancing figure, man. Everything if you post, what are we doing? We have ready-made solution. Okay, when you do this, now you'll get credit side is more. 180 plus 48 plus 252. What? I just now wrote the answer and removed it. Still you got the wrong answer. What is this? 1,68,000. Credit side is more. That means do you have to pay money? Will you pay 1,68,000? How much will you pay? Only 50 paise you will pay. No, 50 paise in a rupee. 50%. Yes. 1,68,000, 84,000, 84,000. Is it clear? This is called as deficiency. If you do in the books of J, right, that 84,000 will be called as bad debt. Clear? Is it done, guys? Yes, done, finished. December 2022. Let's go further. But in our final revision, we told that we have to look at last 4 attempts questions of bills of exchange. That will give you more clarity. Yes, June. After June comes September. After September comes Jan. After Jan comes May. Clear? So from June onwards, we have to see what and all bills of exchange questions are there. In June, was there any bills of exchange question? Answer is yes. Where is it? Rectification, depreciation. Alternative 1, alternative 2 full. Alternative 3 also they are given. NPO, resolution, June they didn't ask, is it? Bills of exchange? Are you sure? Inventory, manufacturing, BRS. Didn't ask her. 100%. Yeah, 24. Okay, one done. So fast, in 1 minute we finish one exam question because it was not asked. Okay. Now, September attempt. There is a nice question. If I am not wrong, where is it? Oh, here you are. Harry met Sejal. Yes. Harry. 10 marks. Yes. 10 marks. Why are you surprised? 10 marks. Good, no? Yes. Let's start this question. What? Bigga. Yeah, man. Silent, she was okay. Suddenly, I don't know what happened. Oh, you like bills of exchange? Which is your hometown? Where? Huh? Where? AP, Andhra Pradesh. Where in Andhra Pradesh? I met other people from Chittoor. They are not like this. How are you like this? What dynamic bomb? He's always like this, or today is a special occasion? Always like this. Okay. Yeah. You're not from ICU. Then what you guys are telling yes. How do you how do? You told no. But you told yes, right? You're seeing things in 10x. But still you're starting days what? Oh, all the marathons you have come to. Okay. That means 10x is working. See, I can make fun of you because 2.7x. How many? Yeah, you should have been in regular class. Where did you attend your regular class? Sept, yeah. How much you got in the previous attempt? That's the spirit. Only 69 marks more. Look at the number you cracked. So how's your preparation this time, man? Good, no? Should clear, okay. We need students like you in Inter. Inter, no. I'll see how you will keep your energy like this. If you meet me in Inter, we will be seeing each other's face for at least 190 hours. 190 hours minimum. Advanced accounting. Then we should meet again in finals. Because I want to see early morning 6 o'clock how you will have energy. Okay. Yes. Sir, I wrote for 40 and got 80 and got 40. No problem, just prepare. I think there are a lot of errors. Just look at the errors and try to rectify that. Not a problem. That's not a bad mark. Good morning. Let's continue. Harry draws a bill on Sejal. Jab Harry met Sejal. Clear? For 60,000. First of all, you have to understand who are you. You are not Sejal. You are Shah Rukh Khan. Harry. You are Harry. Give journal entries in the book. So, oh, sorry. You are Sejal. I'm very sorry. You are Sejal. And they told, what? Bakwas man, see man, they are telling your Sejal, okay? And they are telling, also prepare ledger account of Harry. In Sejal's books, Harry's ledger only will be there. I was seeing whether you are hungry or awake. Yeah. All working should form part of your answer. See, when you told that food is not good, then why are you craving for that? Huh? Food is not there. That is the concept. Okay. Harry draws the bill on Sejal. Shh. Important question, guys. I am telling you it's important question. Towards the end of this question, now ICA has kept one bamboo. Okay. Now, Harry draws a bill on Sejal for 60,000 on 1/1/2023 for 3 months. Sejal accepts the bill and sends it back to Harry to get it discounted. We'll see the second part. Who are you? You are Sejal. So for you it is bills receivable or bills payable? Bills receivable or bills payable? Payable. Very good. I like the energy now. Okay. So let's go and check over here. Harry account debited to bills payable 60,000. Clear? Sorted. Everything will go smoothly. Question is simple only. Okay. One twist. That's all. Now. And Harry gets it discounted for 56,000. Should you pass any entry? No. Let Harry do anything with that bill. Harry remits 1/4 of the amount to Sejal. 60,000. You got only 56,000. How much did Harry give you? 1/4. That means it is 14,000. But discounting charges are how much? 4,000. Out of that 4,000, how much they will put on your head? 1,000. That means you will get 14,000 on your head and you will also get 1,000 discounting charges on your head. So what should be the entry? Bank account debited, discounting charges debited to Harry. You're only Sejal. Clear? Done. Next. Let's go further. What happened? Huh?
Monday's test, what question is this?
Do you want the good news or the bad news? Huh? Bad news, I don't know. Good news, I'll tell you. There is a high chance that you will not have test only on Monday. Look at the speed at which we are going in the marathon. The marathon only will go to Monday. So that time your test will be, it's high chances. We are supposed to finish final accounts. We are still in bills of exchange. Yeah, 2 questions are left. And I don't know the portion, man. To be honest. Why are you worried about that now? Hello, why are you worried about that? Consider entire portion. 1 by? If you already know the answer, why you ask the question? Which 1 by 3 wanted to know? Okay. Shh. Hello. Sir, let's continue. Okay, on the due date, Harry was unable to remit his share to Sejal. Who are you? Sejal. Harry was unable to remit his share to Sejal. Rather, accepts a bill for 80,000 for a period of 3 months. Now you had bills payable, right? Harry did not give the share, but you are still going to make the payment, no? You are still going to make the payment. So now, have a look at the entry. You are going to make the payment. So the entry will be, oh, they have not written the entry. Here they have written. Bills payable account debited to bank. And what Harry is going to do? Harry is like, boss, I don't have any money. We'll do one thing. You draw a bill on me. I will accept it. 80,000. Harry is accepting a bill. What is the entry for this? Bills receivable to Harry. Bills receivable to Harry. Done, finished. That also sorted. After that, what you're going to do? You took that bill, went to the bank. Bill was discounted by Sejal. Who are you? You are only Sejal. 74,600. Clear? 74,600. You will pass the entry. Bank account debited. Discounting charges debited to bills receivable. Till here, everything is smooth. This entry only is little twisted, which you have to think, which was asked in the exam. Okay, now focus. See over here. Sejal, after making the payment of first bill, sent 3/4 of the amount remaining to Harry. Okay. On maturity, we'll see what will happen. That's a different thing, story altogether. Sejal, after making the payment of the first bill, tell me how much is the bill amount here? 80,000. Is the bill amount 80,000? Is the discounting charges 5,400, which makes it 74,600? Do you agree with this? Correct? Tell me one thing. This 74,600 should be shared in what ratio? It should be shared between Harry and Sejal. In what ratio? Do you agree it is 3:1? Because that time Sejal received only 1/4. Only 1/4. 3:1 is the ratio. Can you see the question? Harry remits 1/4 to Sejal. So 3:1. So use your calculator and tell me 74,600 minus into 3/4. It is 55,950. Is that correct? And this side? Yes, 18,650. That's correct. Okay, this is the ratio. Clear? Now, 55,950 falls on Harry's head. Harry's head. Along with that, there is discounting charges also which is going to fall. So 5,400 into 3/4. How much is it? Yes, 454050. That totals up to how much? 60,000. Clear? But how I am actually supposed to, this bill who discounted with bank? Sejal discounted with bank. Who got the money? Sejal got the money. Actually, Sejal is supposed to give 55,950. No. Actually, Sejal is supposed to give 55,950. But what happened over here? Last time, Harry did not give the money only. Harry did not give the money. What was the old bill? 60,000. In that 60,000, okay, it is 45,000. No, Harry's share. You are like, sir, it was not discounted for 45,000. It was discounted for 56,000. Okay, but still in that, if you take it as 56,000, for you to understand, it is basically 14,000 and 42,000. Is that correct? 14,000 and 42,000. How much is the discounting charges? 4,000. In that 4,000, 1,000 will fall on Sejal's head and 3,000 will fall on Harry's head. So how much was Harry supposed to pay? 45,000. But Harry has not paid 45,000. Because Harry did not give 45,000, I drew a bill. And that is why in the question, they have specifically told, okay, see over here, Sejal, after making the payment of the first bill, send 3/4 of the amount. 3/4 of the amount remaining to Harry. Clear? How much was the amount actually? 55,950. Out of 55,950, Sejal will not give 55,950. She will keep 45,000 in her pocket only. Are you getting this? Follow this, guys. Very important twist. Directly in the exam. It's not there in any study material question anywhere. Now, 74,600 is the bill amount. 3:1 ratio. When you divide this, you realize that this is Harry's share and this is Sejal's share. So legally, actually, according to the agreement, Sejal was supposed to give 55,950. But from the previous bill, still 45,000 is pending from Harry's side. So what Sejal will do? 55,950. She will remove 45,000 and remaining amount, that is 10,950, she will give it to Harry. Do you agree with this? When giving 10,950 to Harry, along with that, she has to put this 4050 also on Harry's head. Because 4050 is Harry's share of discounting charges. Now, the entry you see. Now it will make complete sense. Harry account debited 15,000 to bank to discount. Is this clear? After that, there is no problem at all in this question. If you see, after doing so much for Harry, on maturity date, Harry becomes bankrupt. Harry becomes bankrupt. First bill, Harry drew the bill on Sejal. And Harry did not give the money. Still, Sejal went and made the payment to bank. Second bill, Sejal drew the bill on Harry. Harry became bankrupt. So, bank took the money from me. So, basically in this question, both the bills as a drawer as well as drawee, Sejal only made the payment. Is this clear? So, now, if you go and see the next entry, it will be Harry account debited to bank. This is the entry for bill discounted, dishonored. Bill discounted, dishonored. 80,000. Now, next what you are going to do? Just make a ledger. I am not doing the ledger because we have already learned how to make the ledger. All the journal entries post it. That time you will get to know how much Harry is supposed to give. Harry is not going to give everything. Harry is going to give, I think, in the ratio of 40-60. Okay, 40-60 Harry is going to give, and that is the entry. See, this is the ledger you will make. When you do this ledger, you will get to know how much amount has to be received from Harry. Clear? Debit balance is more, that means it is receivable. Credit balance is more, that means it is payable. Is it clear? This was your September 2024. Clear? Let's go into Jan 2025. 5 marks, huh? What? Or question, huh? How do you remember it? Yes, here is it. Because it, what? Wrote it? Wrong, huh? Okay. I will do one thing. Okay, guys, next question. 5 marks. You are required to give journal entries in the books of Mr. B. Who are you? Mr. B. Clear? Mr. A accepts 2 bills of exchange on June 1st, 2024 for 1,50,000 and 60,000 drawn on him by B. Who is accepting? Who is accepting? Mr. A or Mr. B? Mr. A is accepting. So who are you? Mr. B. Good, no. Bills receivable for you. Wait, it is too much scrolling, right? I'll try to keep the solution in the side so that quickly you can navigate. Give me a second, guys. Jan 25, right? Yes, yes, good morning. Okay, guys, yes, ready. Jan 25. Okay, now you don't have to like scroll. Okay. Now, 2 bills, 1,50,000 and 60,000. Bills receivable? Yes. Bills receivable 1, bills receivable 2, 2 A is account. You are B only in this question. Clear? No doubt about this, no problem at all. Yes. The bill of exchange for 1,50,000 is for 2 months, while the bill of exchange for 60,000 is for 3 months. Let it be. Just keep it in mind. Mr. B got the first bill discounted with the bank for 1,49,000 on June 3rd. 1,49,000 if you have gotten it discounted. How much is the discounting charges? 1,000. So you'll pass the entry for this. That is bank account debited 149, discount account debited 1,000, 2 bills receivable. First bill gone. Clear? On August 2nd, Mr. A requests Mr. B to cancel both the bills. To cancel both the bills. Very sad story. And drew a new bill with on him with the combined amount of both the bills along with interest of 12% per annum for a period of 2 months. Is he paying interest today? No, he's going to pay interest in future. So first you cancel the bills. Mr. A's account debited. To bank, 2 bills receivable. Why? One bill is dishonored which was discounted. Another bill is dishonored which is in your pocket. Clear? Next you are going to draw a new bill. New bill will be with interest. 2,10,000, right? So 2,10,000 and 12%. And they ask for how many more months? 2 months or 3 months? 2 months. Okay, 2 months. 2 divided by 12. Are you getting 4,200? Okay. New bill amount will become 2,14,200. And you are getting interest, or you are supposed to get interest. Interest account credited to Mr. A's account 2,10,000. Is it clear? Any doubts with this? Next, after that, what do you have? Before the due date of the renewed bill on September 3rd, 2024, Mr. A becomes insolvent. Very bad. Mr. A becomes insolvent. The nice, beautiful bills receivable is gone. Correct? Now here they have passed direct entry and they also told you can pass 2 entries. That is Mr. A's to bills receivable. First cancel the bill. First dishonor the bill. And then you pass the bad debt entry. That is always better. Now, how much is Mr. A going to give? 40 paise in a rupee. That is 40%. So, you're going to write bank account debited. This is 40%. What you don't get is very bad news for you. That is bad debt 60% to this person. Is it clear? Done. What is the problem? What happened, man? May 2025. It was simple, right? Next question. Next question, Jan. They again asked a question for 5 marks. B. Where is B? Done now? Are you ready? Then we have to move into final accounts. Final accounts is very silly chapter. Nothing is there in that. What happened? Where are you going? Break? Who told you? You have taken more breaks than attending class today. Okay. Let's go into the last question of bills of exchange. That is May 2025. Okay. Last question of bills of exchange, May 2025. Now, look at the question. Okay. Very, very simple. Who are you first of all? Who are you first of all? You are Aman and Gagan both. We'll do one. If there is complication, we look at other. Because when there are only two parties, if you do one, then other party automatically is just mirror image. For mutual accommodation of himself and Gagan, Aman drew on Gagan bill for 7,500 on 1/4/2024. Gagan accepted the bill and returned to Aman. What is the entry for this? Oh, you are Aman. You are Aman. Bills receivable account debited. Is that right? Is it right? Yes. Bills receivable account debited to Gagan. Okay, simple, right? Then what did you do? You got it discounted immediately for 8% per annum. Very good. 8% per annum. Don't directly multiply 8% and get the wrong bamboo. Okay, it is for how many months? 3 months. So 8% into 3 divided by 12. Don't forget that. So what will you write? Bank account debited, discount account debited. Can you see the calculation of 3 by 12 here? And bills receivable gone. Clear? Normal bill drawn, bill discounted. Finished. Next. According to agreement, Aman and Gagan shared the proceeds in 2:1. So whatever money you get, you have to give it to that person. But not only the money, you have to put the discounting charges also on that person's head. So you'll pass Gagan account debited to bank, to discounting charges. Can you say discounting charges was 150? 1/3 you are giving because you are sharing the money in the ratio of 2:1. So 1/3 you are going to put it on that person's head. Is it clear? Next. On the date of maturity, Aman remitted his share to Gagan, who honored the bill for payment. First question of mutual accommodation you are seeing, on the maturity date, no, that person actually gave the money. All the other cases, that fellow will draw a bill and the story will continue. Who is going to pay the money now? Aman. Aman remitted his share. What was Aman's share? Out of 7,350, okay, 2,450 you have given. Okay, you have given. That means 7,350 minus 2,450. That gives you how much? 4,900. But not only 4,900, out of 150 discounting charges, 50 was that, guys. That means 100 was yours. So totally you have to pay 105,000 rupees. Is it clear? You have to pay. Aman has to pay because Aman kept 2/3 of the share. No. So Aman will return the money now. When he is returning the money, what should be the entry? Okay, someone has asked, only after receiving we can credit interest, right? No. We have already entered into an agreement. So interest is credited. Accrual concept. Clear? Don't bring conservatism and tell that, oh, income should not be recorded. Interest, already there is a contract. So you are going to receive it. Clear? So 2,500 gone. Now you are going to pay 5,000 rupees. Gagan to bank. Finished. Same thing, mirror image will be there over there. So I'm not going to discuss that. With that, we are done with bills of exchange. Clear? Where are you going? No, we are continuing. No break. Next, we are going into final accounts. Next, we are going into final accounts. Is this clear? Now, what next? Final accounts. Clear? Small chapter. Hardly anything is there in this. Okay. First, we will see what and all we have to study. That is, first, concepts. Hey, where are you going, man? Huh? Your sister is staying till 9:15 in class. You are going. Right?
Class is ended.
Class ended. How come?
Last week itself, he vacated the PGN.
Oh. Today what classes? Class is there no today.
The portions are completed last month.
Oh yeah. Oh, she was for her last subject was costing, right?
Yeah.
Yes. Bye. Now first you are going to study the concepts. After that, there are two people you cannot ignore in final accounts. Two people. You cannot ignore two people in final accounts. One is Gavaskar, other one is Ganguly. Gavaskar and Ganguly you cannot ignore at all. Whether you like cricket or not, you cannot ignore them. Clear? Now, let's go into the final accounts. Can you see Gavaskar here? Everything is there in that. Then after that, Ganguly, everything is there in that also. That's it. December 2023 exam. Also, we will have a look because there is manufacturing account, I think, asked in that question. Oh no, but we'll just go through that. Then also December 21 question is there, 15 marks. That's it. Not much is asked from final accounts. So what are we going to do? Final accounts. First thing, don't forget Gavaskar and don't forget Ganguly. Do Gavaskar and Ganguly properly. Okay, then they will only give you the goalie for the exam. Clear? You don't have to worry about anything else. Because these two questions cover all adjustments. And all adjustments which consistently they are asking in exams. Clear? Now, after Gavaskar and Ganguly, I also want to go through. Okay, I'll give you the reference. Okay, right. Gavaskar is SM12. SM12. And Ganguly is SMPQ1. SMPQ1. After SMPQ1, then let's solve December 2023 exam. December 2023. Question number 4A. Question 4A. After that, we'll go into December 2021. December 21, question 5B. After that, that's it. Then, last 4 attempts. Aste. Jasti illa. Final accounts alva. Okay, that's it. Ante. Let's continue. Now, good morning guys. Welcome back. So successfully after 12 hours we are still here. After 12 hours we are still here. 7:30 in the morning we met. Now it is 7:38 in the evening. And how is the Josh? Good. I am only telling. Okay. Now, let's go into revision of final accounts. Let's go into the revision of final accounts. Okay. Obviously, we did all these circles for the entire day to be in a position where we can find out the profit of the company and know the position of the business, not company, profit of the sole proprietor and position of the sole proprietor. We are not going to do final accounts of company. Everything if you eat at lunch, breakfast time, then what will you have for lunch? Correct? Final accounts of company will be had at lunch. Don't worry about that. Easy. Easy peasy. Okay, nothing to worry. Now, final accounts of sole proprietor, very easy. From school you are doing this. Correct? 11th standard, 12th standard, from there you are learning this final accounts. It shouldn't be a problem. What? What? 2020? COVID. COVID will come, COVID will go, minutes. Okay. Don't worry. Now also COVID is there. Are you aware of that? No. COVID is there. People are getting COVID. Just like one cold, it will come and go. Hello. Boss. Let's continue. Yes. Final accounts. Let's discuss the concepts of final accounts. Little concepts only are there in final accounts. Okay. Now, final accounts can be of two types in the exam. One, manufacturing business. Another one is non-manufacturing business. If it is non-manufacturing business, you will have to prepare trading account, P&L account and balance sheet. In trading account, what you are going to do? Why? To find the gross profit or loss. What is gross profit? What is gross profit? Yes, before deducting all indirect expense. Basically, it's your profit from your direct trading activity. Direct activities, okay? And P&L, what is the point of preparing P&L? To find your net profit. That means your final profit that you're supposed to find. And then balance sheet will tell you your future position statement. If at all you're preparing manufacturing account, manufacturing business, one extra thing will be manufacturing account that is prepared to find the total cost of goods manufactured. From once you manufacture the good, what will you do with that? You will give it to them for trading. That will go to trading account. From there to P&L, then there to balance sheet. Is it clear? Now, trading account for the year ended. I don't have to tell you what is there in trading account. First it is opening stock, purchases, less returns, sales, less returns, okay, closing stock, okay, and direct expenses should be there in trading account, that is wages, carriage inward, etc. And there can be gross profit or there can be gross loss. Clear? Are you following this? Yes. Now sometimes, very rarely, okay, in study material there are questions where they can ask you the journal entries for trading account. Okay. Now, tell me, what is the journal entry for this? Trading account debited to opening stock. What is the journal entry for this? What is the journal entry for this? This less also, you are not doing just minus. There is a journal entry. That's why that less is happening. What is the journal entry? Purchase returns account debited to purchases account. Then the net purchase will come and sit in trading account. Purchase returns account debited. See here. Purchase returns account debited to purchase account. Once the purchase is reduced, the reduced purchase will come and sit in trading account. Is it clear? Now, what is the entry for this direct expense? Trading account debited to direct expense. What is the entry for this sales less returns? Sales account debited to sales return. Any plus minus is not going to happen without you passing journal entry in books of accounts. Clear? So sales less sales return. Is this clear, these two things? Now, what is the entry for sales then? Sales account debited to trading account. What is the entry for closing stock? Closing stock account debited to trading account. What is the entry for gross profit? Trading account debited to gross profit, or you can directly put it to P&L. Trading account debited to P&L. Usually you write no gross profit carried down. Carried down means where it will go and fall into P&L only. So you are going to write trading account debited to P&L or trading account debited to gross profit. Then gross profit account will be debited to P&L. You can take an indirect route or you can take a direct route. Okay, if it is gross loss, what will you do? Gross loss account debited to trading account, or you can directly write P&L account debited to trading account. Is this clear? Yes, these are the journal entries, okay, which we discussed. P&L account. P&L account is basically stuff everything. Whatever you can't put in trading account, you dump it everything over here. That means expense and incomes only. Don't put asset and liability also here. For that there is balance sheet waiting. Clear? Now, gross loss brought down or gross profit brought down. Okay, then indirect expenses, everything else. What will you write? P&L account debited to expenses, income account debited to P&L. Clear? Net profit carried forward to balance sheet. Can you tell me the journal entry for net profit? P&L account debited to capital account carried forward to balance sheet, and in balance sheet you will write add. That means credited to capital account. Here loss, what should you do? Capital account debited to P&L account. Is this clear? Yes, these are the journal entries which we just discussed. All this we have discussed. Next, balance sheet is position statement. Do you have a format for balance sheet? Do you have a format for balance sheet? No, it's the sole proprietor's balance sheet. There is no format. But as a matter of good presentation, always keep the fixed assets on top and then keep the current assets. Always fixed assets you keep on top and then you enter the current assets. Is this clear? Now when you are when you're preparing, you will be preparing trading P&L balance sheet all together. When you're preparing all together, if you find stock, leave the first half, write it in the second half. Okay. Liabilities. We have discussed today morning. Do you remember how capital moves? Opening capital plus additional capital plus net profit minus net loss minus drawings. If interest on capital is there, add the interest on capital. If interest on drawings is there, minus the interest on drawings. Usually you won't find these two in sole proprietor because he will not give himself interest and he will not charge himself interest. Clear? So this you will find usually in partnership. Here also you follow our methodology. Keep the capital on top. Insiders liability right at the top. Outsiders long-term liability next. Outsiders current liability after that. Is it clear? Yes. Yes. Let's continue. Now adjustments. Somewhere in your life, okay, you have seen that whatever is given in adjustment, someone has told you whatever is given in adjustment, it has to be put into two places. Correct? Why? Yes. Whatever you are seeing in adjustments, is it outside the trial balance? Is it outside the trial balance? Yes. 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 If it is outside the trial balance, that means they did not pass the journal entry. Because if they pass the journal entry, journal would have gone to ledger and ledger would have gone to trial balance only. So if it's outside the trial balance, they have not passed the entry. Now you are supposed to pass the entry. If you are supposed to pass the entry, we know only one method, that is dual aspect concept. So there should be a debit and credit. If there is debit and credit, that means it will impact two places. That is why they should tell in 11th and 12th that it will go to two places. Is this clear? Clear? Yes. Few adjustments, guys. Few adjustments. Adjustments, items mentioned in question for which entry is not passed, okay, will be given outside the trial balance in question, that you already know. First adjustment is depreciation. First adjustment is depreciation. If it is given in the trial balance, that means do you agree entry is passed? That means directly transfer it to P&L. If it is given in adjustments, that means do you agree entry is not passed? Depreciation is an expense, so P&L will be debited and depreciation will reduce the asset balance, so asset will be subtracted. Clear? Now, provision for depreciation. If it is given in the trial balance, do you agree it is a liability? It's a liability, but for better presentation, we bring it to asset side. When we bring it to asset side, what will happen to asset? Subtracted. Clear? If it is given in adjustments, what will happen? P&L account debited because depreciation is an expense. Asset will be subtracted. What happened? Doubt? Okay. Next. Drawings. Drawings, if it is given in TB, that means entry is already passed. Go and subtract it from capital. If it is given in adjustments, then you see whether drawings is in cash. If it is in cash, reduce from capital and also reduce from cash balance. If it is in goods, reduce from capital and also reduce from purchases. Is it clear? These are some regular adjustments, okay? Outstanding expense. If it is given in trial balance, did they pass the entry? Yes. Sir, can you show depreciation again? No, man. You see later. We have moved much ahead. Depreciation, where we were, man? 748. I think depreciation we were at 448. Huh? Oh, adjustment. Oh, sorry, my bad. Yes, that I can do. We can take a break to drink water. So you are doing up and down from AP. Where are you staying now? Who? Where? Who is there over there? No, yeah, but with whom is he staying? Oh, you are from Bangalore only. What about BCom? That means you can do whatever you want. That means you are free now during the day. Nice, you should study, okay? Huh? Come to Inter, yes. We need him an Inter. Suddenly, what? What is the timing? You know, there is one more branch now. There it's morning. There it's morning. It's good. Morning is good actually. Oh, you are telling it to go back, it will be tough for you. You have work. What are you doing? Huh? Yeah, what work are you doing with your friends? Huh? Exploring. I really thought that he is doing some part-time work or something. He is telling that he has to explore with his friends in the evening. No problem. You do one thing. Morning you attend class. Evening you explore. Huh? No, actually, even I am curious. What is there? Some nice things you tell. What you explored? Crazy man. He is like his friends go for part-time job for him, and with that money they explore. From where you found these friends? So your friends go for part-time work. Where? Yeah.
They get money.
Yeah. Now why you are not doing that? When you have friends like that, why he needs to do it? But I like your honesty, man. Because if I was in his place and if I'm in a classroom with so many unknown people, right? I would have told that I am the friend who is working and my friends are wasting money. But he is like, no. My friends are doing part-time work for me and I am spending it. But you were born where? Sept itself. But crazy man. But they never thought, why are they simply working hard to feed you? They never thought about that. From how many years you know them? That means, trust me, they are bakaras. What? That is what I'm telling. This link I will send it to them, okay? YouTube marathon, when it goes on YouTube, I'll send it to your friends. This part only will trim it and we'll give it to them. Yeah, we'll put it in shorts, just this part. And we'll increase the volume of volume where he is talking. Yes, let's continue. Okay, outstanding expense, if it is in TB, that means it is a liability, it will go straight to balance sheet. Okay. Now, if it is in adjustments, then you have not passed the entry. Can you please tell me what is the entry for outstanding expense? Expense account debited to outstanding expense. Therefore, it will get added to expense and in balance sheet, you will show it as liability. If it is prepaid expense, when we are talking about prepaid expense, if it's there in the trial balance, do you agree it's an asset? Yes, so directly it will go to balance sheet as an asset. Now, if it is in adjustments, entry is not passed, right? So what is the entry for prepaid expense? Prepaid expense account debited to expense account, that means expense has to be subtracted. Balance sheet will show it as asset. Clear? Next, income accrued. Income accrued. If it is there in the trial balance, income accrued means income receivable. Balance sheet, straight away asset. If it is in adjustments, what will you do if it is in adjustments? Income you are going to add. Income you are going to add because the entry is income receivable account or income accrued account debited to income account. Balance sheet will show it as asset. Is it clear? Income received in advance, like how you received from your friends. In trial balance, okay, if income is received in advance, in balance sheet it will be shown as liability because you have the responsibility of giving it back someday. Clear? Now, if it's in adjustments, okay, income actually you don't give it back, but you have not done your work. That's all. Okay, your obligation still pending. Rent received in advance, you're not going to give the rent back, but you'll use that. You'll allow that person to use the building. Now, in adjustments, if it's in adjustments, what happens? What is the entry? income received in advance means income account debited to income received in advance because it is liability and income will be subtracted. Is it clear? Now, the biggest game changer in final accounts is what we are going to discuss now. Bad debts. This, how much ever times you see, you still make mistakes in this. Clear? Let's go slow. Bad debts. Clear? Now, what is bad debts? What is bad debts? Fresh, we are coming from bills of exchange. What is bad debt? Somebody is not making payment at all. Correct? It was receivable, but somebody is not making payment. Okay, your state of your friends. See how relatable it became now suddenly. Now, bad debts, if it is there in the trial balance, do you agree it's a loss? Straight away P&L debit. Straight away P&L debit. But if bad debts is there in adjustments, that means entry is not passed. Can you please remind me? I forgot. What is the entry for bad debts? Bad debts account debited to debtors. So P&L debit because it's a loss and debtors have to be subtracted. This is a situation where only bad debt was there. Only bad debt. No question of provision at all. Only bad debt. Now, provision for bad debts. Here, I am discussing only provision is there. Only provision. No, nothing is spoken about bad debts. Now, provision is amount kept aside for expected bad debt in future. Do you agree with this? If it is in trial balance, what should we do? Provision is what? Asset or liability? Provision is liability. So, do you agree that it should go to the liability side of the balance sheet? Yeah, for better presentation, we'll bring it into asset side. That time it gets subtracted from debtors. Clear? Because it is liability, when it comes to asset side, it changes symbol and it becomes negative. Is this clear? Yes. Now in adjustments, when it is in adjustments, what is the entry? What is the entry for provision for bad debt? P&L account debited to provision for bad debts. So P&L debited and in balance sheet debtors will be subtracted. Is it clear? Now example. Let's take an example. Okay. Understand this example. In trial balance, you are seeing debtors as 5 lakhs. Are you seeing in trial balance there is a debtor of 5 lakhs? Yes. Now bad debts 5,000 is also in the trial balance. Bad debts 5,000 is also in the trial balance. That means is the entry for this 5,000 already done? Yes. That means in P&L directly you will put the 5,000. In balance sheet debtor will still remain at 5 lakh only. That means this 5 lakh is after subtracting the 5,000. After subtracting 5,000. Is it clear? Bad debt will play a crucial role. I'm telling you, it will play a crucial role. You have to get the concept right. Next. Bad debt 5,000 is sitting in adjustment. That means what? Entry is not passed, right? Entry is not passed. So pass the entry and in P&L bad debt will be debited. And balance sheet now debtor will be 495. It will not be 5 lakh. It will become 495 because bad debt will be reduced from the debtor. Clear? Now PBD. What is PBD? Provision for bad debt. 5,000 is shown in the trial balance itself. That means already provision is created. You don't have to create it again. So directly in balance sheet, you will write debtor as 5 lakhs. Can you see when there was bad debt, you directly wrote the debtor as 495? Here, you will not write the debtor as 495. You will write the debtor as 5 lakhs only and you will subtract PDD. Net amount you will write 495. Now in this example, if I ask you, what is the debtor balance? It is 495. It is 495. In this example, if I ask you, what is the debtor balance? It is 5 lakhs. It is 5 lakh. Are you getting my point? So, PDD is just, you are having the idea that they might not pay. It is not confirmed. Is it clear? Now, PBD 10,000 in trial balance. PBD is 10,000 in trial balance. Yes, what's your doubt?
He just told that provision for bad debts can be put in liability.
Provision for bad debt can be put in liability side. Actually, they are not supposed to cut marks if you put it on the liability side also. But for better presentation, it is better to put it on the asset side. Now, thing is what, the answer key will have it on the asset side. Now, the person correcting should think so much that it can be put on the liability side also. So, why you are giving him so much work to think? So better put it on the asset side itself. Okay. But otherwise, if you talk about technically, if you put it on liability side, it's not wrong. Okay. Now, PBD is 10,000 in trial balance. What does it mean? Already there is 10,000 in the trial balance. Already it is created in the past and kept. Maintain PBD 5% in adjustments. They are telling maintain PBD 5%. How much was our debtors in the trial balance? 5 lakh. 5 lakh, 5% is what? 25,000. But do we already have 10,000 in the trial balance? Yes. When you reduce that, it becomes 15,000. Provision to be created. 15,000 is the provision to be created. Is it clear? Now, let's go further. In P&L, you'll write only 15,000. Why? Provision to be created was 15,000. Only for that you are going to pass the entry in P&L. P&L will be divided for 15,000. But in balance sheet, full 25,000 will be reduced. Why? 10 was already there. 15 you created. That became 25,000. Is it clear? Yes. Good morning. Now, PBD 30,000 in trial balance. PBD 30,000 in trial balance. Maintain PBD 5% in adjustments. Now when you calculate 5%, how much it became? 25,000. How much is the provision required? 25,000. Provision required 25,000. Provision existing 30,000. That means you have more provision. What will you do? Remove it and enjoy it. Okay, that means put it back to P&L. 5,000 provision to be reversed. P&L credit. And in balance sheet, debtors 5 lakh minus PBD 25,000. PBD will be still shown as 25,000. Why? Because they told maintain provision at 5% and provision was 25,000. Because we had extra, we removed and put it to P&L. Previous example, we had less. So we took it from P&L and we created the provision. Are you getting this, guys? Yes. Now, sixth. PBD 25,000 in trial balance. Bad debt 6,000 in adjustment. What to do? Bad debt from where we have to remove? Bad debt will be removed from provision. Now understand this. Whenever you have confusion about bad debt, understand this. You are Kapish. You are Kapish. Clear? And you like to watch movies. Rajini man. He's holding cigarette. Huh? Cigar. Huh? No, head is having hair like that. Wig by the way. Huh? Disclaimer what? Smoking is injurious to health. Yes, it is there in the corner here. Smoking is injurious to health. Now, you are a person who is a huge fan of Rajni. So you decided that you have to save money and go and watch Coolie movie first day, first show. Clear? So whenever your parents, when you tell your parents about Rajini movie, right, they will tell you study. Correct? Whenever you tell your parents that you have Rajini, you have to go for Rajini movie, they told study. You can't go and ask your friends because they are not doing part-time job. Okay. They are not doing part-time job. So what you decided, whenever your parents are giving money, pocket money for food, okay, you are going to save some money in that. Okay, you are going to save some money in that. So from your pocket money, what you will do, you will transfer the money to your movie fund. You created one fund called as movie fund. So you removed money and put it into movie fund. On the date of the movie, what will you do? Will you remove money from pocket money or will you remove money from movie fund? Movie fund, you already created the movie fund. So you will take from movie fund and go to the movie. Clear? But after going to the movie, if you realize that popcorn is actually more expensive than movie, then you will have to spend more money. For that you did not make the provision. So then you will have to spend from pocket money. Clear? Imagine you didn't think of all this. You didn't know only Rajini movie is going to release. Or you created a movie fund for Rajini movie. After watching Coolie, you felt very bad. You felt that you should watch one more movie. So you decided to go for another movie. For this you did not create any provision. So now what will you do? You have to remove money from pocket money. Forget the movie. Forget the movie. Pocket money is P&L. Clear? Movie fund is provision for doubtful debts or bad debts. Movie is bad debt. Movie is bad debt. Now, tell me one thing. if you have provision and there is bad debt, will you take it from P&L or will you take it from provision? Provision. If it is not enough, what will you do? You will have to take from P&L. That is the concept. That is the concept which you have to remember. If you have provision, you kept money aside telling that there might be a situation that someday somebody will not pay. So I took the profit and kept it in the side. And when somebody actually does not pay, again if you are taking from profit, what is the logic? What is the logic? So when you have kept aside money and you have provision for bad and doubtful debt, and if somebody actually does not pay the money, take the money from PBD. Do not take the money again from P&L. But if the PBD is not sufficient, then what is your other option and only option? You have to go to P&L. Is this clear? What man, the iWatch also the friends gave, is it? The iWatch? That also friends gave, is it? That is an iWatch, right? A noise. Friends 1 month tuition fees. Converted into noise. No. What he means to say is mom gave him birthday for his birthday. I was actually keeping you little up, man. You only jumped down. Mom took it for her birthday. Then you took it. She bought for her birthday and you took it for yourself. When is your dad's birthday? Or next time when your dad's birthday is there, no, ask him to buy iPhone for himself. Then you take it for yourself. This is the only place you can't do jugaad. I am telling you, everywhere else your jugaad is working, right? CA exams are the only place you can't do jugaad. Maybe if you would have done engineering, right? Pakka you would have topped the college. You know why? All the internals, you would make somebody do it. Okay? And exams, some jugaad you would find and leak the paper. And you would crack the exam. But in CA you can't do it. Hey, but before that he'll get iPhone. You watch. When he's in inter class itself, right, he'll get iPhone. Because he'll make his father buy it and then take it from there. Are you the only kid? Then? Elder, younger? You know who is going to suffer? Your brother. You know who is going to suffer? Your brother. You know how I am telling with so much confidence? Because I saw my sister suffer. Because I was the elder brother. Why I am telling with so much confidence? What? 8? 8:30, right? 8:30 I'll wind up. Okay. Now listen. Shh. PBD. Hello, boss. Get back. YouTube people, we are taking these breaks because the energy is so low of these people. Okay, so we have to boost the energy. Only one person is there with crazy energy. That fellow, he is the brand ambassador of Red Bull. Red Bull is paying him to take the energy. Then they are preparing the energy drink. Are you getting my point? That is his state. But interesting, right? Did you ever think somebody will make mother buy the smartwatch on her birthday and then take the smartwatch? So actually the smarter person is this guy. Okay, now listen. Okay, this I actually saw in Coffee with Karan, okay. You know, Coffee with Karan, Ajay Devgan and Kajol, I was watching that episode. So they were asking Ajay Devgan, what do you buy Kajol for birthday? So he said, whichever car I like, right, I will gift it to her. And then I will only drive it. I will take it. Yes, PBD is 25,000. Very important situation here. PBD is 25,000 in trial balance. That means already created and kept aside. Bad debt is 6,000 in adjustment. So do you agree that it is not yet entered? So bad debt, when you enter, bad debt is an expense. But because already PBD is there, you will take it from PBD only. Correct? And that bad debt has to reduce the debtor also. Correct? Bad debt has to reduce the debtor. Now, debtor is sitting directly at 494. Debtor is not 5 lakh. Debtor is sitting directly at 494. and provision is sitting at 19,000. How it became 19? Out of 25, 6,000 we have removed for provision for bad debts. So right now balance of debtor is only 475. Is this clear? Now, if PBD exists, then bad debts to be debited to PBD. If PBD doesn't exist, then bad debt to be debited to P and L. Are you following this? Okay, next. Closing stock. Closing stock. Very, very regular adjustment. Okay, very, very regular adjustment. If it is not there in, if it is there in adjustments. If it is not there in adjustment, no, then bamboo. Are you getting my point? If it is an adjustment, you know what to do. Trading account, credit side, balance sheet, asset. Correct? But if closing stock is there in trial balance, that means in the trial balance, there is one more person called as purchasers who is adjusted purchase. Are you aware of this adjustment? If closing stock is there in the trial balance, that means how did the closing stock come into the trial balance? That means they passed the entry, and the entry that they passed is closing stock account debited. Closing stock account debited. Guess what? First illustration of study material of final accounts has this adjustment. First illustration of final accounts where they have given purchases and all, which is adjusted purchase. First illustration. Clear? Now, closing stock account debited to purchases. So now you are like, sir, usually entry is closing stock account debited to trading account. No. What you are telling to purchases? When is trading account prepared? Only at the end of the year. If at the trial balance stage only, if you are seeing closing stock, that means before trading account, trial balance is prepared, right? So that means how did they bring the closing stock into the trial balance? By passing this entry. Now tell me one thing. When you have trading account, you put closing stock here. Whatever is there on the debit side gets subtracted, reduced. So instead of that, directly if you reduce from purchase also same effect. So if at all they are doing it in accounting stage, then they can pass this entry only. They can't pass to trading account. If you are doing it in final account stage, then you will write to trading account. Is it clear? So whenever, trust me, whenever you see closing stock in the trial balance, that means the purchase which you are reading there is adjusted purchase. Whether they tell you or not, the purchase is 100% adjusted purchase. It is adjusted for what? It is adjusted for the closing stock. Clear? So now, opening stock plus purchases minus closing stock is adjusted purchase. Now, what if I don't find opening stock at all? That means that is also adjusted with purchase. How did it go away? That is adjusted with purchase. What if you have opening stock and closing stock? That means closing stock is adjusted with purchase. Opening stock is not yet adjusted with purchase. Are you following these different situations which you can see? Okay, next. Opening entry, closing entry. Total bakwas. Opening entry means what? Opening the books of accounts for the year. Closing entry means what? Closing the books of accounts for the year. Closing the books of accounts, what will you do? Entry passed at the year end to close the books. What will you do? Remove everything from the books. What do you have in books? Only two things. What do you have in books? Only two things. Assets and liabilities. Where did income and expense disappear? They all went to trading or P&L account. So only thing that will be remaining is assets and liabilities. Okay, now the entry will be liability account debited, capital account, capital is also liability, you know that, capital account debited to asset. Remove the liability, remove the asset. But next year when you start the year, what you should do? You should put back the liability, you should put back the asset. So asset account debited to liability account to capital account. Is this clear? Any doubts with this? No. Next, provisions and reserves. What is provision? Amount kept aside for particular reason. What is reserve? Just amount kept aside. Amount kept aside for future. Whatever, you can use it for anything. So amount set aside for future use is reserves. Amount kept aside for specific purpose is provision. Clear? After that, we have to discuss one more thing, that is manufacturing concern. If you have a manufacturing concern, till now what we were discussing? Non-manufacturing concern. We were discussing about non-manufacturing concern. Next thing is about manufacturing concern. Everything is same. What extra? Manufacturing account. Then trading, then P&L, then balance sheet. What is the purpose of doing this? To find the cost of goods manufactured. What is the purpose? To find the cost of goods manufactured. Now, manufacturing account, try to understand. Okay. Opening WIP. Now, in inventory, you have three types of inventory. Do you agree? In inventory, you have three types. You have raw material, you have work in progress, you have finished goods. Raw material and work in progress will go to manufacturing account, finished goods will go to trading account. What is the logic? Raw material and work in progress are part of the manufacture. After the manufacture is completed is what you get, that is finished goods, that is used to trade. So that will go to trading account. Clear? Now, manufacturing account, you have opening WIP. Opening WIP. That means last year's closing WIP. You put opening WIP on the debit side, closing WIP on the credit side. Clear? Now, raw material purchase you are not putting, raw material opening stock you are not putting. You are always going to write raw material consumed. Raw material consumed. So you'll write opening stock of raw material plus purchase minus closing stock of raw material. Clear? Net amount you'll put it on the outer column. That means how much raw material did you use to manufacture the goods. Clear? Next, direct wages. What is the next thing? Direct wages. Why? Because it is directly required for manufacture. Direct expenses. That is also required. Other expenses related to manufacture. Basically anything that is related to manufacture will all be sitting in manufacturing account. Tell me one thing. Manufacturing is happening over here. Okay, there is one machinery over here. Machinery is working and there are two people working on the machine. Whatever you pay them, are you going to take it as manufacturing expense? Yes. There is one guy standing far away and just having a look. Are you going to take that fellow's salary also into manufacturing account? Yes. Supervisor's salary is also taken as manufacturing expense only, because if this fellow is just having a look, because he's having a look, everybody is working. Are you getting my point? So directly, indirectly, whatever is required for manufacturing, it will be taken. Imagine one guy is sitting in office in front of a laptop and is passing journal entries. Will you pay whatever you pay that guy? Will you take it into manufacturing account? No, you'll take it to P&L account as salary. That is indirect. Even if that fellow is absent for a day, manufacturing will still continue. But if these two are absent for a day, manufacturing will be halted. If this fellow is absent for 1 hour, manufacturing will be halted. Why? Because if supervisor is not there, they'll take a break. Are you getting my point? Now in ICU batch, what happens? Like someone is sitting there inside, then all will be studying. And no one is there inside, you know what you do, right? Huh? Yeah, but you study loud, that voice comes outside also. If someone is there inside, you study softly. Yes. Now after that, byproduct sale. What is this byproduct sale? What is byproduct? Sale of? I was manufacturing something. I got one waste product. That waste product I have wanted to just throw it off. Correct? When I was throwing, someone caught it. They are like, you sell to me. Okay. Are you getting my point? Good. Sell. You got money, income, credited. Are you getting this? Example, biggest, very common day-to-day example is your buttermilk. Buttermilk is your day-to-day example. Buttermilk, they are not putting any effort. They are manufacturing butter ghee. That time by default, one waste liquid will be released. That waste liquid, they are supposed to throw it down the drain. But you are waiting to drink it. So now what will they do? They'll pack it and sell it. Is it clear? Are you getting my point? Okay. Now, sale of byproduct will reduce what? Cost of manufacture. Sale of byproduct will reduce the cost of manufacture. So now the cost of manufacture will be your balancing figure. Where will it go? It will go to trading account. Is it clear? Now, next. Notes. Stock. Raw material will go to manufacturing account. Work in progress will go to manufacturing account. Finished goods will go to trading account. Now, when you're talking about carriage inward means what? You're telling hi to the truck. Truck is coming in, manufacturing account. Carriage outward, you're telling bye to the truck. Truck is going out, it will go to P&L account. Is it clear? Supervisor salary, already we discussed, so no more discussion on that. Manufacturing account. Now, rent. Rent, you have to be careful. What rent are they talking about in the question? If rent is on factory building, obviously it is used for manufacturing account. Rent is on godown. Godown is required for manufacturing to store the material. That is also manufacturing account. Rent is for office building. Then it will go to P&L. Is it clear? Next, depreciation. Now, depreciation on factory building should go to manufacturing account. Depreciation on go down should go to manufacturing account. If depreciation is on office building, it will go to P&L account. And depreciation on vehicle. Imagine you have a vehicle like a forklift. You know forklift? Nothing, it's used in factory and all. It will go like this. And then you'll keep it under this and you lift it like this. Correct? Now depreciation on that. Is it going to be manufacturing or P&L? Manufacturing, because it is used in factory. It might not be used directly to manufacture, but it is used in factory. So vehicles, when you're talking, factory vehicles, manufacturing account, other P&L. That is basically, you might have some truck for delivery. Okay. That is going to be taken as factory vehicle. But you might have one car where directors are going home. That will be going straight into P&L. Is it clear? Yes, that's it. Oh, one small chapter is awaiting us. Very small chapter. Nothing is there in it. Yes, guys. That's it for the day. See you tomorrow. Bye-bye. Welcome. Tomorrow morning we start at sharp 7:30. Okay. Bye. Okay. So let's continue with the final accounts. We have discussed yesterday the concepts of final accounts. Let's go into the problems of final accounts. As I told you, the first problem, the first two problems which you have to see. It's a bare minimum. One is Gavaskar problem, another one is Ganguly problem. Then we will see December 2023 4A and December 2021 5B. Just we'll go through the adjustments of those two questions. Then we will go through the last 4 attempts and we should be done with final accounts with that. Clear? Yes. First question is question number SM12. SM12. Have you guys gone through this Gavaskar problem? Very, 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 very important. When you go to exam questions, you'll realize how important it is. Yeah, here you go. Small question, small solution. Yeah. Now, look at this question. Always when you have a final accounts question, right? First, you analyze the adjustments. Always analyze the adjustments. Now, see over here, prepare trading and P&L account for the year ended 31st March 2022 and the balance sheet as at that date after making provision for the following. Clear? First one, depreciate building used for business by 5%. That shouldn't be a problem at all. It's a straightforward adjustment. Go and check how much is the building in the trial balance. Can you see building over here? 6 lakhs. On that directly 5%, you're going to compute depreciation. That means it's going to be 30,000. 30,000 depreciation. Shouldn't be a problem. So straight away what you're going to do, the double effect of that will be 1. Depreciation, they have taken it as everything combined. Now 1 we know that is 30,000. 1 is 30,000. Clear? Other one, you can see building 6 lakhs minus 30,000. Net amount will be there in the balance sheet. Clear? Next, after building, the next adjustment is furniture and fixtures by 10%. But after rectification, one steel table purchased during the year for 14,000 was sold for the same price, but the sale proceeds were wrongly credited to sales account. What has happened over here? Steel table purchased during the year, sold during the year. Steel table, once again, my bad. Okay, steel table which was purchased during the year only and it is sold during the year only. Purchase, is it recorded properly? Yes, no problem with purchase. But the sale which is there, wrongly they have credited to sales account. What should be the correct entry for this rectification? You have to remove from sales, so sales account debited, and you have to actually remove from furniture, so furniture account credited. Is it clear? Okay, sales has to be subtracted and furniture also has to be subtracted. Why sales has to be subtracted? Because it is wrongly taken as sales. Why furniture has to be subtracted? Because furniture is gone. Asset reduces. So 14,000 you have to remove. Then you can calculate depreciation. So if you go and check how much is your furniture, Furniture is showing 2 lakh 14. So 2 lakh 14 minus 14. Okay, then you will calculate depreciation, and depreciation is how much? 10%. So on this, when you calculate 10%, that makes it 20,000. So first the rectification, both places, then the depreciation in both places. Now if you see furniture, directly can you see 2 lakh minus 20,000? 1 lakh 80 is there in the balance sheet. And 14,000, whatever we have discussed, it also has to be removed from purchases. Removed from sales. Can you see 14,000 is removed from sales? Sales, they have subtracted 14,000. Okay, this has to be done. And the depreciation of 20 should be included in this total depreciation. Total, all the assets together, they have put the depreciation. Clear? Next adjustment, if you see, office equipment by 15%. Okay, straightforward. But purchase of a typewriter during the year for 40,000 has been wrongly debited to purchase account. That means asset purchase was taken as goods purchased. Remove from purchase and add it to asset. Okay, basically the rectification entry would have been asset account debited to purchase account. So asset is debited, asset increases, purchase is credited, purchase should reduce. So now if you see this, okay, where is our equipment? Equipment is here, 1 lakh 60. So what should we do? 1 lakh 60. For that you have to add the 40,000. Then you have to calculate the 15%. That makes it 30,000. That makes it 30,000. Is it clear? Are you following this? So now if you go and check in your material, okay, can you see 40,000 is added to purchase? Okay, and can you see 30,000 depreciation also should be included in this 1 lakh 20. And when you see the balance sheet, can you see motor car is direct, not motor car, equipment is directly taken as 2 lakh only. It's not taken 160. 160 plus the 40 and minus depreciation, it becomes 1 lakh 70,000. Clear? Next adjustment of depreciation is last, motor car by 20%. No rectification, nothing. Directly you take motor car 20%. How much is the motor car right now? 2 lakh. On 2 lakh, if you are taking 20%, that makes directly depreciation of 40,000. If you go and see here, 2 lakh minus 40,000, 1 lakh 60. Clear? And if you see the fourth depreciation, when you put 40,000, can you see it is adding up to 1 lakh 20,000. That is the breakdown of all the 4 depreciations which are there. So rectification first, then only you can depreciate. Clear? Now when we go further, one adjustment only we have finished. Second adjustment, value of stock at the close of the year is 4 lakh 40. Pretty ordinary and normal adjustment it is. Closing stock, what will you do? Go and put it to trading account 4 lakh 40 on the credit side, and then showing the balance sheet as asset, stock in trade 4 lakh 40. Clear? Next, 2 months rent for go down is outstanding. Whenever usually you see this rent outstanding adjustment rate, value is also given to you there itself. But here they say 2 months rent is outstanding, but they haven't mentioned what the value is. So you have to go and check in the question, rent for go down. Can you see rent for go down? 55,000. If 2 months rent is outstanding, that means 10 months rent is paid. And if the outstanding rent is sitting outside the trial balance, that means outstanding entry is not passed. That means this 55,000 is only for rent paid. Tell me what is the entry for rent outstanding? Rent account debited to outstanding rent. So even if it is outstanding, it would have been included over here if they had passed the entry. Correct? But they haven't passed the entry. 55,000 is only there here and rent outstanding is sitting outside. That means entry isn't passed. So can you conclude with that information that this 55,000 is actually rent for only 10 months? So 55,000 divided by 10 months, you are actually getting 5,500 per month. Therefore, into 2 if you do, 11,000 is the outstanding rent. Outstanding rent, what should you do? Add it to rent and show in the balance sheet as outstanding rent. So if you go to your P&L, see, in the balance sheet, can you see outstanding rent 11,000? And in P&L, it should be added to rent. See over your rent 55,000 plus 11,000, total rent of 66,000. Clear? Next adjustment, interest on loan from Vishwanath. There is one adjustment. See over here. Interest on loan from Vishwanath is payable at 12% per annum. This loan was taken on 1/5/2021. Go and check. Okay. How much is loan from Vishwanath? Can you see loan from Vishwanath sitting over here? 3 lakhs. Okay. So 3 lakhs into, what is the rate of interest they said? 12%. When did they take that loan? 1st May. When did they take that loan? 1st May 2021. So that means only April interest is not applicable. So into 11 by 12. That comes to 33,000 should be the interest. But if you see over here, interest on loan from Vishwanath is showing 27,000. So do you know that 6,000 is outstanding?
Yes.
Now go to your material and see interest on loan 27,000 plus 6,000, 33,000 will be your total interest. And in the balance sheet, you have to show 6,000 as outstanding. Okay, and loan is 3 lakhs. So total amount is 3 lakh 6,000. No need to actually add it to loan. You can show them as separate items. Loan is 3 lakh, outstanding interest, you can show 6,000. Clear? Next. After that, interest on loan from Vishwanath is also done. Provision for bad debts to be maintained at 5% on sundry debtors. 5% on sundry debtors. Now, this is a very critical adjustment. Now, have you done anything before this which has affected the debtors? Have you done anything before this which has affected the debtors? Now, you will think like that, correct? But what is the debtor value? Where is the debtor? Starting on 8 lakh 60,000. So you will think 8 lakh 60,000 into what provision percentage they said you have to maintain?
5%.
5%. So 8 lakh 60,000 into 5% makes it what? 43,000. 43,000 is the provision which we require. This is the required provision. But do we have existing provision in the question? Go and check. Do we have PDD? Can you see provision for bad debts? 30,000. But will this 30,000 remain if there are bad debts in the question? If there are bad debts, what will you do? You will take it from provision itself. Go and check in the entire question. Can you find bad debts anywhere? Can you see bad debts 20,000? Can you see bad debts 20,000 here? So now what will happen? Here, out of 30,000 existing provision, do you still have 30,000? No. Minus bad debts 20,000. That means you are left with what? 10,000. Okay, the provision is 10,000. Okay, how much provision do we actually require? 43,000. So that means you need to create a provision of 33,000. Did you get this? Okay, so now how much provision should be there in the P&L? How much provision should be there in the P&L? 33,000. But how much should go from the debtor? 43,000. Entire provision. What is there? What is not there? What is not there was created. So entire provision has to go from debtors, and debtors will show 8,17,000. Clear? If you go to P&L now. P&L, provision for doubtful debts. Can you see 33,000 sitting over here? Are you getting this point? So always from the existing provision, subtract the bad debts. Bad debts, whether it is inside the, inside the trial balance or outside the trial balance. If provision is there, bad debts will get reduced from the provision. Then after that, you see how much provision is remaining. Then you calculate and see how much provision is required. Difference amount has to be created. That means P&L account has to be debited. But whatever is the total amount of provision that is required, that will be the one which you will find in the balance sheet, which is getting reduced from the debtors. Clear? Okay. Next, after that, you have only one thing. Insurance premium includes 40,000 paid towards proprietor's life insurance policy, and balance of the insurance charges cover the period 1/4/2021 to 36/2022. We are preparing balance sheet and financials till when? Only till 31st of March 2022. But they have already paid till the future. That means the extra 3 months that they have paid is called as prepaid insurance. But first you have to go and check how much is the insurance premium. 55,000. Out of 55,000, do we agree that 40,000 is paid for proprietor's life insurance? That means this is drawings. This is drawings. Only remaining 15,000 is for the business. So first thing is that 40,000 has to be shown under capital. Can you see minus from capital? Because it is drawings. And then 15,000 is also not for the full year. It is for extra 3 months. So here you have to do 12 months and 3 months. 12 months is for this year. That means 12,000 only for this year. And 3,000 is prepaid insurance. Prepaid insurance is an asset and it should be subtracted from the expense. So now when you go to your P&L, can you see insurance premium? Only 12,000 is there. 15 minus 3. And in the balance sheet, you should find 3,000 prepaid insurance. Is it clear? And drawings, whatever you subtracted, it has gotten reduced from capital. Now you are done with all the adjustments. Now you're only going to worry about the things that are there in the trial balance. Now first thing in the trial balance is what? Cash in hand, cash at bank, both straight into the balance sheet. Can you see in the balance sheet? Done. Straight, fill in the blanks after this, most of the things. Okay, then you have stock. This is opening stock. Where will it go? Trial balance. Go to trial balance and see opening stock. Go to trading account and see the opening stock 6,20,000. Next, after that, all of these are done. Debtors done, stock done, furniture, equipment, building, motor car, everything done. Now sundry creditors. Can you see sundry creditors directly into balance sheet? Can you see 4,30,000 in the balance sheet, sundry creditor? Now, after that, purchases. But whenever you see purchases, don't go straight away and write it. Purchases less returns. Can you see in the trading account? Purchases and also purchase returns. This is the net amount. Clear? Next, after that you have sales. Sales also never go and write directly. Sales less returns. So you can see sales here and you can see sales return, that will give you the final amount. Clear? Next, after that you have, this is done, salary. You have salary there. Any outstanding salary, anything mentioned? Nothing. Straight away salary will go into the P&L. Okay. Yeah, here it is. Salary 1,10,000. Next, rates and taxes, discount allowed. Any adjustment show any of this? No. Directly rates and taxes, discount allowed in the P&L. Next, discount received directly into P&L credit side. Then after that, freight on purchases. Trading account. This is carriage inward. You can find it in the trading account. Next, you have carriage outward. Carriage outward you'll find in the P&L. Next, you have drawings. One more extra drawing was there that we have already reduced. This is the existing drawings that will get subtracted from the capital. After drawings, you have next thing, printing and stationery, electricity charges. Straight into P&L. There shouldn't be any problem with this. So, printing and stationery, electricity charges. Then after that, you have general office expenses, bank charges. Any adjustment to this? No. General office expense, bank charges, straight away. Okay, then you have motor car expense. What to do with motor car expense? P&L. Some of them get confused and think that motor car expense is an asset. No. Motor car is an expense. For the car, if you put petrol, that is not an asset. Okay, motor car is an asset. Motor car expense is an expense. So 36,000 straight over here. Done. Then you have capital. Put the capital into the balance sheet. Then can you see all the things we have verified in the balance sheet? And in the P&L also, every item is there. Only gross profit is not there. That obviously is the balancing figure. Whatever you get over here, you know it will go further. And whatever net profit you find over here, that will get added to the capital. Is it clear? This is the Gavaskar problem which you have to look at, okay, before you go to the exam. After that, you have one more problem, that is Ganguly. It's in PQ, practice questions. What, you're already feeling cold? Yeah, that you can. Angle is completely under your control. 18th question. Okay, 18th question. Non-manufacturing SM practical question number 1. Now, here also this becomes a very important question. Let's go into the adjustments. Can you see the number of adjustments? In exam, they'll pick some adjustments from Gavaskar problem and they'll pick some adjustments from Ganguly problem and directly ask in the exam. Okay, now, value of stock as on 31st March 2022 is 3,93,000. Did this sentence get over? They put full stop. I think full stop is to tell when the sentence gets over, right? Yes, sentence got over. 3,93,000. Now, straight away, closing stock 3,93,000. Balance sheet 3,93,000 asset. Clear? Now, next they said, This includes goods returned by the customer on 31st March 2022 to the value of 15,000 for which no entry has been passed in the books. What to do? But will the stock change? No, they said this includes. How can it include in the closing stock, but they have not passed entry in the books? Yesterday we learned inventory chapter. How can it be included in the closing stock, but they have not passed entry in the books? Huh? Yes, it is physical counting. They went to go down and count it. They got it. That is the closing stock. Because it was returned, it was kept in the go down. Because it was kept in the go down, it's there in whatever they counted. Are you getting my point? Whatever they counted, it is there. But in the books, they have not passed entry for this. Because it is sales return. They have missed the entry. So what entry will we pass? What entry will we pass? Sales return account debited to debtors. Sales return account debited to debtors. So now this 15,000, you have to ensure that it is reduced from sales or it is added to sales return. Okay, 15,000 should be there added to that sales return. There might be some more sales return which is already there in the trial balance itself. Okay, if you look in the trial balance, no? Can you see sales return in the trial balance? Where is it? Yes, 43,000. Can you see this 43 and that 15 became 58,000 sales return? Is it clear? Next. What next? It will be added to debtors. When we do the provision calculation, no, we'll do that debtor in detail. Sorry, subtract it from debtors. When we do provision calculation, we'll discuss that. Okay, apart from that, now see, purchase includes furniture purchased on 1st January 2022 for 10,000. Is this an error again? Rectification. And depreciation should be charged on furniture at the rate of 10% per annum. First you go and find how much is the furniture that is there. Can you find the furniture? What? 9,000. Yes, 9,000 is the furniture. Clear? To this 9,000, do you agree that we have to add one more furniture of 10,000? That time our total furniture will become 19,000. But on this 9,000 ka furniture, we have to charge depreciation for the entire year because it is there from the starting of the year. So 9,000 into 10%, that makes it 900. But this 10,000 furniture, it was purchased on what date? 1st January 2022. That means we are preparing everything till when? Till 31st March 2022. Only 3 months depreciation is applicable. So into 10% into 3 divided by 12 is equal to 250. That means our total depreciation is 1150. Clear? So 19,000 minus 1150, you should have 17,850. Clear? That should be a furniture value. Now if you go and check first depreciation on furniture, can you see 1150 here? Clear? Be careful. The rectification directly don't calculate depreciation for the entire year. Okay, depreciation you calculate only for 3 months because it is purchased only on 1st January. Now, if you see your furniture, 9,000 plus the 10,000 which is purchased, 19,000 minus 1150. Can you see 17,850 over here? But one more thing you have to do, this 10,000, it has to be even removed from purchases because it was wrongly included in purchases. So if you go and see purchases, minus 10,000. Is it clear? Next, after that, loan account from Dena Bank in the books of Ganguly appears as follows. Why did they give this? Anyone has any idea? Loan ka ledger they have given. They said loan account is like this. If you go to the trial balance and see loan from Dena Bank, can you see 1 lakh here? Can you see 1 lakh loan from Dena Bank? And can you see the closing balance of loan from Dena Bank is 1 lakh? Balance carried down. Why? Why did they give you loan ledger? Excess loan. We took loan, that's it. There is nothing called as excess loan. We took loan. What is excess loan? Interest calculation, yes. We took loan. This is for interest calculation. Can you see, if you would have gotten only this much information, you would have told me that interest on this loan is 12,000. You would have told me interest on this loan is 12,000. But now also if you tell interest on this loan is 12,000, that is wrong. Because if you go and check loan from Dena Bank, this loan is on what date? 1/4/2021. Can you see it's on 1/4/2021? Clear? From starting of the year. This by bank means what? He took loan. Okay, loan borrowed. Bank account debited to loan account. Loan borrowed. But when did he borrow this loan? 31st March 2022. Clear? 31st March 2022. Now 31st March 2022, if he has borrowed loan, tell me, you have to calculate interest or not? No, because last day if you borrow loan, where you will give interest? It will be only applicable from next day. That next day is falling into next year. So on this there is no interest. On this there is interest applicable, that is 6,000. Is it clear? On this there is interest applicable. That is the reason why they gave you that loan. Loan ledger. Otherwise, why will they give loan ledger? Clear? Now, let's keep that pending. We have other things to think of also. Sundry debtors include 20,000 due from Robert and sundry creditors include 10,000 due to him. What is the circus? I have to give you 500 rupees. Let's assume that I have to give you 500 rupees. Don't ask me now after class. Sir, that 500 you have to give me. Okay, 500 rupees I have to give you. And you have to give me 50 rupees. You have to give me 50 rupees. Now, will I actually come and give you 500 and then take the 50 rupees from you? Or will I just give you 450? 450, right? Now, here we have one person called as Robert. Okay, in debtors, he is there 20,000. That means he has to give me 20,000. And in creditors, he is there 10,000. That means I have to pay him 10,000. So, can we net this situation off? So, therefore, from debtors, I will remove 10,000. And debtors will be only 10,000 now. And creditors will be 0. Are you getting my point? When I have to give you 500 and you have to give me 50, net situation is 450. That means only I have to give you now. You don't have to give me anything. So same way, Robert had to give me 20 and I had to pay Robert 10. So when the 10 gets adjusted, I don't have to pay Robert, but Robert has to give me the net balance of 10,000. So do you agree that 10,000 should be subtracted from debtor also and from creditor also? Then only you'll get the net situation. Okay, so now when you go and check the final accounts, can you see in your debtors? Okay, just remember this. Okay, just remember this adjustment because I'm not able to show that because they have shown the entire amount. When we do provision no calculation, I'll show this. But remember this: interest paid includes 3,000 paid to Dena Bank. How much did you tell me that interest has to be paid for Dena Bank? 6,000. Interest paid is only 3,000, they said. Now, if you go and check, okay, if you go and check, can you see interest paid over here? 4,500 is written. When they are telling that interest paid is only 3,000 to Dena Bank, that means what is that other 1,500? Some interest. Some interest. We are not worried about that. But 4,500 interest, out of that only 3,000 is paid to Dena Bank. So now, can you see 3,000 is paid to Dena Bank. How much was supposed to be paid to Dena Bank? 6,000. So can I add the 3,000 and call it as interest outstanding? Now tell me what should be the total amount of interest in your P&L? No, 7,500. That 1,500 is also there. No. So 1,500 is something other interest. It might be interest on some OD which you had during the year. We don't know. So 4,500 plus 3,000. Okay, our total interest becomes 7,500. Is it clear? Now, in your P&L, you should find 7,500 interest and 3,000 outstanding interest should be there in the balance sheet. Now, 7,500 interest and in the balance sheet, can you see outstanding interest on bank loan 3,000? Is it clear? Okay, don't worry and think that what is that other 1,500? Nothing. They are paid, right? We are not worried about it. Now, and here interest received represents 1,000 from sundry debtor due to delay on their part and the balance on investments and deposits. What are they telling? Interest received 1,000 is from sundry debtors. Our debtor made late payment. I have charged interest on that guy. Are you getting my point? Debtor made late payment. I have charged interest on that guy and balance whatever interest is there. They are telling it is on our investment and deposit. Go and check in the balance sheet. Do we have investment? 25,000. On 25,000, if you calculate interest, how much should be the interest? 25,000 into 5% is 1,250. Is that right? Do you have deposits? 1,50,000. On 1,50,000, if I calculate interest, it should become 15,000. That means do you agree? My total interest is 1,250 plus 15,000. Is it 16,250? 16,250. Clear? Now go and check how much is the interest received. 7,250. 7,250. Interest received is 7,250. Now tell me how much is outstanding interest. How much is outstanding interest? Correct. It is 10,000. Outstanding interest is 10,000, not 9,000. This is the error you will make. Out of 7,250 interest, everything is not from deposit and investment. 1,000 is from debtor. So out of this, 1,000 is from debtor. That means how much is from investment and deposit? Only 6,250. How much were you supposed to get? 16,250. That means 10,000 is the interest. Are you following this? 10,000 is outstanding interest. So 10,000 you have to find in your balance sheet as outstanding interest. Oh, sorry, not outstanding interest, interest receivable. Where is it? Can you see? Interest accrued on investment and deposit 10,000. And one more question for you guys. Good morning. How much should be the interest income in the P&L? You can see the screen. How much should be the interest income in the P&L? How much should be the interest income in the P&L? Yes, 17,250. That 1,000 is also income, no? Why are you only focusing on 16,250? Because 16,250 is the deposit and investment. That is not the only thing. Even that 1,000 is also income. Why did we eliminate that 1,000 over here? Because we want to see how much is outstanding. That 1,000 is not outstanding. They said it is received. So here if you see, income should be 17,250. Is it clear? Very important adjustment of interest outstanding and also interest receivable. Provide interest payable on Dena Bank and interest receivable on investment. Already done, no? They said make that outstanding interest and prepaid, interest receivable and all, calculate. Make provision for doubtful debts at the rate of 5% on sundry debtors. No such provision needs to be made on deposits. First, you have a task. Do you have existing provision? Anywhere can you see provision for doubtful debts? No. There is no provision for doubtful debts. Okay. Now, listen. That means entire provision has to be created. How much is your debtors? Can you see sundry debtors 1,20,000? Now, how much provision they require? They require provision of 5%. Now, if you go and check debtors 1,20,000. On that 5%, if you calculate, how much is that? 6,000. That is not the provision. That is not the provision. You have done so much circus. There was one sales return first. There was one sales return which you have to remember. Do you remember the sales return? How much is the sales return? 15,000. 15,000 sales return. So minus sales return 15,000. Now you are having 1,05,000. Can I calculate provision on this? No, because Robert is not going to pay. No. We did one adjustment with Robert. So minus Robert 10,000. How much are you getting now? 95,000. On that, can I calculate 5%? Yes, 5% of that is how much? 4,750. This should be our provision for doubtful debts. Now, when you go to balance sheet, can you see 95,000 minus 4,750, 90,250. And this, did we have some existing provision? No. That means entire provision was created. If it is created, it should be there in the P&L as well. 4,750. Provision for doubtful debts. Is it clear? Now, after this, everything is just fill in the blanks. Yeah. Correct? Everything is fill in the blanks. See, Ganguly's capital account, 540, 500. Balance sheet, 540, 500. Next, stock, opening or closing? Opening, 2,34,000. 2,34,000. Next, sales, 1448. But can I take sales directly I should always search for sales return. Can you see sales return is there 43, which we had already broken down that time because there was extra sales return there. So sales return and sales both are taken care. Clear? Did you understand how 43 became 58? Rectification of errors. Next, after that, you have purchases. Can I directly write purchase? No, there is also purchase returns. So can you see purchases and purchase returns? Clear? Now that rectification of furniture, we have already discussed that time. 10,000. Okay. Next, carriage inward. Trading or P&L? Trading. 93,000 you can find in the trading. Next, rent. Trading or P&L? P&L. Can you see 28,500 in the P&L? Next, salaries. Any outstanding for salaries? No. Salaries. Can you find salaries in the P&L? 46,500. Next, sundry creditors. Do you know sundry creditors? Where should it go? Balance sheet. Can you see balance sheet sundry creditors? Here it is showing 74. There it is showing 64. Why? In the trial balance I can see 74 here and there it is showing 64. Why? Minus 10,000 of what? Robert. Yes. 10,000 of Robert subtracted. That time you will get 64,000. Clear? Next, after that, can you see printing and stationery and advertisement? Total bakwas. Directly you are going to put it into P&L. Printing and stationery, advertisement both are here. Clear? Next, going to the other side. Interest is already taken care. Interest received. Cash with the traders bank. Let them keep with traders bank or any bank. It will go to balance sheet only. So directly you will write cash. Okay. Then discount received. Where will it go? P&L. Can you find it in the P&L? 14,950. So can you see that 80% or 70% of final accounts question is just fill in the blanks. That 30% if you deal with properly, it is easy marks actually. Now, see, most of the things now we are just filling it, directly going and putting into trading P&L or balance sheet. Next, investment 25,000. Where should it go? Balance sheet 25,000 investment. Next, discount allowed. Where should it go? P&L. Discount allowed 37,700. Then general expenses straight into P&L 19,600. Audit fees straight into P&L 3,500. Very high audit fees. Okay, fire insurance premium 3,000 directly into P&L. Next, traveling expenses 11,650 directly into P&L. Then postage telegram directly into P&L. Next, 1,900 cash in hand. It should go directly into balance sheet. 1,900. After that, what do you have? Deposits. What is it?
Balance sheet.
Balance sheet. Asset or liability? Asset. Deposit. If you have kept deposit, it's always good for you. Whenever you want, you can use it. 1,50,000. Next, drawings.
Balance.
Subtract from capital. Can you see minus from capital? Everything is done. If you now look at your solution, can you see everything is marked in the trading account? Clear. Only thing unmarked is what? Gross profit. That is balancing figure. That gross profit comes over here, and in P&L everything is discussed, and that net profit which is there over here, it will come to balance sheet, and that should be it. Loan from Dena Bank we have discussed. I have not marked it here. Loan from Dena Bank 1 lakh. Okay, everything is done. This is your Ganguly question. Now, yesterday when I was discussing something, I noticed expression of yours of not aware of certain one thing. So I want you to see that as well, which was not there in our last minute revision, but still we'll have a look at it. That is question number 1. Illustration 1. This is the one I was telling you when I was talking about adjusted purchase. Now, balance of the financial year, okay, trial balance of financial year is given over here. Can you see purchase and sale, debtors and creditors, opening stock, closing stock? Opening stock always is in the trial balance only. But if closing stock has come into trial balance, what does that mean? That means it is already adjusted with purchases. It is already adjusted with purchases. Now my question is opening stock adjusted with purchases? No. If it was adjusted with purchase, opening stock wouldn't have been there only here. It wouldn't have been there only. So because adjusted purchase means opening stock plus purchase. That means it is already added to purchase. Minus closing stock. That means closing stock is subtracted from purchase. Clear? Closing stock you can find over here. That means it is already subtracted from purchases. Opening stock you are finding over here. That means it is not added to purchase. Clear? Now, Other expenses, fixed assets, capital. Additional information. Creditor balance is 3 lakhs. When? Starting of the year. You are required to calculate cost of goods sold. Tell me what is the formula for cost of goods sold. Rapa you should tell. Opening stock. Okay, very good. Opening stock is how much? 2 lakhs. Plus purchase. Purchase is how much? 10 lakhs. Okay, very good. 10 lakhs. Then minus closing stock. How much? 3 lakhs. So how much you should get? How much? 9 lakhs. But the answer is 12 lakhs. Good morning. The answer is 12 lakhs because minus closing stock is already done. That is adjusted purchase. That's what I've been telling you. See, 12 lakhs cost of goods sold. Understood? Opening stock plus purchases minus closing stock is already done. Minus closing stock is already done. Clear? Now, one more question. Bambu, amount paid to creditors. Amount paid to creditors. Because you are very well versed in incomplete records, you know, you can just prepare creditors ledger. Clear? Creditors ledger you will prepare. What is by balance brought down? Opening balance. Can you see they have told opening balance is 3 lakhs. 3 lakhs. Correct? What is purchases? By purchases. How much is purchases? Correct. 13 lakhs. What I purchased is 13 lakhs. What I compute, when I compute cost of goods sold, I have subtracted 3 lakhs. What did I purchase? 13 lakhs, not 10 lakhs. Okay, this is 13 lakhs. And what is the amount paid to creditors? Amount paid to creditors during the year, we have to find what is the closing stock of creditor, closing balance of creditors? 4 lakh. Can you see 2 balance carried down? 4 lakh. And this is the amount paid to bank. 9 lakh. Is it 9 lakh? Amount paid to creditors. Oh, sorry, my totaling only is gone wrong. It is 16 lakhs. 16 lakhs. So is it 12 lakhs? Yes, 12 lakhs is correct. Is it clear? Now, what is the big mistake you can do? First of all, the big mistake you can do is not know the concept of adjusted purchase itself. Then everything will be wrong on this question. Okay, because if you don't know adjusted purchase, you will not take 13 lakhs over here. Here you will take 10 lakhs. If you don't know adjusted purchase, here again you will subtract closing stock. So both the places you are going to get the wrong answer. Are you getting this? So now understand, closing stock is inside the trial balance. That means it is already subtracted from purchases. That means again when you are calculating cost of goods sold, you don't have to subtract. It will become double effect. Clear? Yes, that is the one question that I wanted you to have a look at. That's it. Then 2 exam questions we have to see, and the last 4 new scheme exam questions we have to see. Whatever is asked. Okay guys, can we go further? Done, no? Okay. Now, what are the 2 exam questions that we have to look at? One is December 2023 and then December 2021. Clear? Final accounts. What was the question number? December 2023? 4A. December 23. People who got material, for them suspense is broken down. No? You already know how many questions are there in that. The number of questions from partnership, have you seen? That has to be discussed. Few. Clear? Now, following is the schedule of balances extracted from the books of RM and Co. We'll have a look at the adjustments. See here. Value of stock as on 31st March 2023, 4,10,000. Very good. This includes goods returned by customer on 31st March, the value of 22,000 for which no entry was passed in the books. Ganguly. Clear? Purchase includes furniture purchased on 110 for 30,000. Ganguly. But it is not 1,1, it is 110. So when you are calculating depreciation on the new machinery, 6 by 12. Depreciate. Gavaskar. Sundry debtors include 35,000 due from Goku and sundry creditors include 25,000 due to him, Goku or Boku or Robert. Doesn't matter at all. It is Ganguly.
Difference we have to take.
Yeah, difference we have to take. No difference. 25,000 we have to take.
It is lower.
Yeah, I have to pay you 20. You have to pay me 2. What will I subtract? I have to pay you 20. You have to pay me 2. What will I subtract? Huh? 2 you will subtract. I have to pay you 20. You have to pay me 2. 2 will be adjusted. No. Why will I adjust 18? I'll be very happy. 18 you adjust. No problem. I'll give you 2 rupees until buy. Are you getting this? Yes. Provision for bad debts is to be maintained at 4%. Ganguly. Clear? Now, insurance premium includes 42,000 paid towards proprietor's life insurance policy. Gavaskar. And balance is for 15, not 15 months this time. It is for 1 month more. See, it is 1 month after balance sheet date. So, 1 month will be prepaid. It is not correct. 1 month will be prepaid. They are paid from 1/5 to 34. They are paid for 12 months only. In 12 months, 1 month is prepaid. In that Gavaskar question, they are paid for 15 months. In that 3 months was prepaid. Here they paid for 12 months only. But in that 12 months, 1 month is going into 34, no? That means 1 month after the balance sheet date. So this also was there in Gavaskar. That's all I wanted to show you. Done. December 2023. Same adjustments. Okay. Now we have December 2021, 5B. December 2021.
That 35 and 25 we have to take.
25 we have to subtract.
The net one what? 10,000 rupees.
No. I have to pay you 35. You have to pay me 25. So 25 will be subtracted from debtors also. 25 will be subtracted from creditors also. That's it. But there are more debtors. No. Debtor is not only this person. No.
You can think whichever is lower.
Whichever is lower, you have to subtract from both places.
Yes.
From both places. Yes, 5B. 5B. A trial balance of Mr. Black, full decision by ICA. Okay. Now, following additional information is there. Now, look at this. Prepare manufacturing account, trading account and P&L. Okay, to this, they can add one more thing also if they want to. Balance sheet. That's it. Okay, let's quickly have a look at it because we don't have any question on manufacturing which we have to discuss. Only little, no? Today is going to be a small day. Fast we'll finish, okay? Don't worry at all. Rapper will finish. What? Well prepared and came. That is the spirit, no? So you're learning from your situations in life. Yesterday you came full underprepared, thinking that sir will leave at 4 o'clock. But you saw that we actually left at 4 o'clock plus 4 o'clock. 4 plus 4, 8. Nice, no? Today, see, every time in life you should break your records. Previous records. So yesterday if you have gone at 8:20, today we should break that record, no? Huh?
821 is better.
8:21 is better, huh? Now, should I tell you what is the importance of today? Final accounts, 15 marks. Max potential, 15 marks. Okay? Then NPO, max potential is around 12 marks. Every time they are asking regularly for 12 marks. Okay? Incomplete records, this or this might come. Okay? But if it comes, both come for heavyweight, it's not possible. This also can be asked for 15 marks. Then, partnership, small one, no? 20 marks will keep, 20 to 25. Okay, last attempt they asked 20, I think. Otherwise, usually they ask for 25. Then, company accounts, that hardly anything it comes, only 25 marks. Only 25 marks. Can you see the weightage of these things? What we are going to discuss today? Now, the order I'll tell you so that you are prepared. After final accounts, then I'm going into partnership. I'm not going into anything, I'm going into partnership. Because then I'll come to NPO. Then I'll go to incomplete records. Then I'll go to company accounts. Because I feel that partnership, if I keep post lunch, right, then I will be a sole proprietor. Are you getting my point? If I keep partnership post lunch, then I will be the sole proprietor who is doing all the problems of partnership. Okay? No? What? You all will be 100% sleeping partner. So that is why post lunch maybe will keep something like NPO, not for profit organization. You sleep, no problem. We are not there for profit. Okay? Or incomplete records. Okay, company account, why I am keeping at the end is actually company accounts is easy. Company accounts is actually easy. Okay, we'll see. Unless ICA makes mistakes in the question paper by messing up the authorized capital and all. When we go to company accounts, we'll see that. Now, anyways, we have to begin with this. From here it starts. December 2021. Hello, good morning. Yes. Now, look at the end of the question. What did they ask you? In this particular question, actually, what did they ask you? They asked you all three. Don't think that, sir, manufacturing account, sir, trading account, P&L account, along with that balance sheet also they are going to ask. The more they ask, less tricky adjustments. The more they ask, less tricky adjustments. If at all in any question in the exam, if they have asked only balance sheet, right, that means it's not easy. That has lot of bamboos. Are you getting my point? So if they ask only balance sheet, that means there are twists and turns in that. If they ask manufacturing, trading, P&L, already time is required for making that only. So adjustments will be bare minimum. Now have a look at this. First adjustment. Raw material, finished goods, work in progress, closing stock. Where should we put it? We are not preparing balance sheet. So one of them will go into trading. These two will go into manufacturing. So if you see your solution, okay, can you see opening stock of work in progress 95,000? Opening stock of raw material directly you don't put. What do? You calculate raw material consumed. So opening stock of raw material, it will get added to purchases and get subtracted from purchases, and then closing stock will get subtracted. Why we write raw material consumed? Yesterday we discussed, because we want to know how much we are actually utilized for manufacturing the products that we have. Okay, next. Finished goods, where will it go? Opening stock. Straight into trading account. Can you see trading account, opening stock of finished goods? Clear? Next adjustment. Salary and wages unpaid for the year. 9,000 and 20,000. Unpaid salary, very good. It will go to P&L and get added to salary. Unpaid wages, very good, but it will not go to trading account. It will go to manufacturing account. Clear? If at all we had balance sheet, both of them would go to balance sheet liability side. Next, after that, machinery is depreciated at 10% per annum. Okay, very good. I'm not even looking at the machinery value. Okay, you know how to calculate it. The reason why we are discussing that is because depreciation on machinery will be over here in the manufacturing account. And one more depreciation is there. Depreciation on office furniture, that will be there in the P&L account. Office furniture, P&L account. Is this clear? Next, after that, provision for doubtful debts is to be maintained at 1% of sales. Usually we calculate on what? Debtors. Now this is also not surprise. I've just not taken up that question in marathon, but this is not a surprise. This is there in SM. Manufacturing concern, go to study material, these same adjustments are there. 1% of sales. How much is the sales here? 16,72,000. So 1672. Oh, sorry, 167. 1%, no?
16,720.
Yeah, 16,720. 1%. 1%. 16,720. Is that the provision? Do we already have some provision here? 16,500. Directly we can't tell anything. Do we have bad debts here? No. So 16,720 is required. 16,500 is there. 220 rupees provision we have to create. Clear? In the P&L. Sorry. In the P&L, can you find 220 rupees provision? Ta-dang. Can you see 220 rupees provision? Yes. But this wouldn't have been this simple if it was bad debt. If bad debt is there, it will get subtracted from the provision. Then you will calculate. Is this clear? Any doubts with this? Now, should I subtract that provision that I created? Should I subtract even from the sales? Because I calculated on sales, it has no connection with that. Sales will be straight away whatever you saw there. Sales was used as a mechanism to calculate the provision. You have nothing to do with sales. On sales, you calculated the provision. That's all. Provision will still be subtracted from debtors in the balance sheet. Clear? Next, after that, provision 15,000. Okay.
Provision will be 15,000 and back will be like 18,000 something.
Then
3,000 will be P&L.
3,000 bad debts will anyways be debited to P&L and full 16,720 provision has to be created. Now what he told is, here we have 16,500 provision. Now imagine our provision is 16,500 only and bad debt is 18,000 in the trial balance or adjustment, doesn't matter. Wherever the bad debt is there, it has to get subtracted from here. But to subtract, that much provision is not there. So 16,500 you use. Then extra 1,500 what you require, take it from P&L.
And again we subtract from the asset side of the debt. So
Which one?
this 1,500 directly, again we create a provision.
No. Bad debt, whether you are going to reduce from debtor or not, depends on whether it is there in the trial balance or not. If it is there in adjustment, not 1,500. Full whatever bad debt, everything will be reduced from debtors.
No, we have subtracted from the provision.
What?
So in adjustment if they given, they are in adjustment if they give.
No, see, subtracting from provision and subtracting from debtors are two different things. Bad debt entry is this. Bad debt account debited to debtors. This is the entry. If this entry is passed, then bad debt will be shown in the trial balance. And bad debt is a loss. So next you have to remove it from P&L. If there is a provision, instead of removing from P&L, what will you do? You will reduce from provision. That is the situation. So now bad debt, wherever the bad debt is in the trial balance, not in the trial balance. If provision is there, you have to subtract from provision. But if the bad debt is there in the trial balance, already entry is passed. Entry for bad debt is this one only. Then if entry is passed and you're seeing it in the trial balance, then bad debt directly you go to P&L and put the bad debt over there. But if you have provision, remove it from provision. And if the provision is not enough, that excess bad debt, whatever is there, you remove it from P&L. When you have removed everything from provision, if provision has become empty, then this required provision fully has to be created that you debit to P&L. Clear? What provision will get subtracted from debtors is the required provision. Full required provision. Because everything you have emptied, whatever existing provision was there. Okay. Next. These are all silly it is. Rent is to be charged 3/4 to factory, 1/4 to office. Find the rent. 60,000. 3/4 to factory. So that means 3/4 will go where? It will go into manufacturing account and 1/4 will go where? It will go to P&L account. Clear? Next one you are seeing lighting. Lighting is charged 2/3 to factory, 1/3 to office. How much is lighting here? 13,500. 2/3 you are charging to factory. So go straight over here and write lighting in the manufacturing. And 1/3 you are going to charge to office. Can you see in office you can find 4,500. Is it clear? That's it. That is it with the adjustments. Do we have any other adjustments? No. Prepare manufacturing account, trading account and P&L and balance sheet. Now if you notice all the things, opening stock, where will it go? Raw material. Raw material, where will go opening stock? It will go to manufacturing account. Okay, can you see opening stock of raw material? Oh, sorry, what did we see that time? Oh, these are the closing stocks. My bad. Closing stocks also will go to same place only, but on the opposite side. Can you see closing stock subtracted over here and closing stock of WIP you will find over here and closing stock of finished goods you will find over here. Is it clear? Opening stock of raw material, work in progress, both will be in manufacturing account and opening stock of finished goods will be in the trading account. Same way, closing stock will be in the same respective places. Now, after that, what do we have? Work in progress done, finished goods done. Sundry debtor, ignore because you're not preparing balance sheet. Okay. Carriage on purchase. Where will you put carriage on purchase? Manufacturing account. Can you see manufacturing account 15,000? Purchase itself is sitting in manufacturing account. How can you put carriage on purchase somewhere else? Okay. Next. Bills receivable. Ignore. Balance sheet item. Wages. Where will you put wages? Manufacturing. Can you see outstanding wages got added to that? Yes. After that, salaries. Where will you put salaries? P&L. Can you see salaries in P&L? Yes. Next, telephone postage, repairs to office. Where will it go? P and L. Can you see here? Yes. Next, cash at bank, ignore. Office furniture, ignore. Repairs to plant. Repairs to plant. Manufacturing account. Repairs to plant has to go into manufacturing account. Purchases. Obviously manufacturing account. Okay. Where will it be? You will not put it on the outer column, you will put it on the inner column because purchases is used for calculating cost of material consumed. Then you have plant and machinery, ignore. General expenses, where will you put it? P and L. Can you see P and L general expenses here? 15,000. Next, that's it. On the other side, you have sundry creditors, ignore. Bills payable, ignore. Sale of scrap. What on? Manufacturing account, credit side. Next, commission received, P and L credit side. Then provision for doubtful debts, don't have to do anything because you use that to calculate this 220 and 220 is recorded. Then capital account, ignore. Bank OD, ignore. Done, finished. Only thing you have to understand is this is the balancing figure of manufacturing account, that is cost of goods manufactured, and that will go straight into trading account, and trading account you will get the gross profit that will go straight into P&L account, and P&L account whatever you get as net profit that will go to balance sheet. If balance sheet is asked, that would have been added to capital. That is it with this question, that is December 2021. Now only thing that we have to do is have a look at the last 4 attempts question papers, okay, for final accounts. That's it. Small day. June. After June we have September. After September there is Jan. After Jan we have May. Okay, let's check in June. Do we have final accounts question? Did we have a final accounts question in June? Anyone remembers? Rectification. After that depreciation. After that your favorite NPO. After that dissolution. Do we have a 8-mark question? Admission, incomplete records. See, incomplete records got asked for 8 marks. Okay. Then inventory, manufacturing. See, they asked manufacturing account. And they asked for 5 marks, not 8 marks. 5 marks. You saw trading P&L and thought that is final accounts. No, that is incomplete accounts. Okay, Mr. Prakash runs a factory which produces pressure cookers. The following details are obtained from his manufacturing expense for the year ended 31st March 2024. Even if somebody comes and shakes your hand in the exam, you should not make mistake in this question. Why? In the heading only they said these are the manufacturing items. Whatever they give, they has to go to manufacturing account. Are you getting my point? They have told these are the manufacturing items. Now the only thing you need to know is how to present it. Opening work in progress, debit side. Closing work in progress, credit side. Opening stock of raw material, inner column, okay, plus closing stock of raw material, inner column, minus purchases, inner column, plus purchase return. From purchase it has to get subtracted. From purchases, this should get subtracted from purchase itself. Are you getting this? Don't put it on the inner column also, don't put it on the outer column also. Reduce from purchase and the net purchase you put it in the inner column. Clear? Then indirect material, debit, direct wages, debit, indirect wages, debit. Don't even worry about the direct and indirect words because they told these are the things about manufacturing expenses. They told you in that thing itself it is manufacturing expenses. Now, power and electricity, debit, repair and maintenance, debit, depreciation of factory shed, debit, depreciation of plant and machinery, debit, sale of scrap, credit. Done, finished. You'll get some balancing figure. That balancing figure is the cost of manufacture. 5 marks. They did not put it on the plate. They opened your mouth and put it and made you bite it. Okay. After that also, if you don't digest it, that is your fault. Are you getting it? So whenever they give such 5 mark questions of manufacture, no, they are going to list only things of manufacture. Done. June 2024, September 2024. Oh, we are at the right time at the right place. When we open only we were here. Final accounts. It is asked for only little marks. 10. Okay, now see over here. First you understand what they asked you to prepare. Trial balance is of proprietor as on 31st March, prepare trading and P&L account for the year ended. Okay, very good, very good. Closing stock. I don't think I have to tell you anything about closing stock. During the year, plant and machinery was purchased for 3 lakhs, but it was debited to purchase account. Ganguly, Gavaskar, both had this adjustment. Clear? Next, 3 months factory rent is due but not paid. Gavaskar had this adjustment without even giving the amount. Here they have given the amount. Just go and do the needful. Clear? Just go and add 3,000. They said no, not paid. 3 months factory rent. They never told 3,000 per month. They just told 3,000. They never told 3,000 per month. Just go and add 3,000 to whatever rent is there. That's all. And show it in the balance sheet as outstanding. Now, provide depreciation 5% per annum on furniture and 10% on machinery, motor van, everything. Nothing to worry. Gavaskar, Ganguly, everybody had it. Clear? Now, further bad debt. This one we have to discuss. It was not there in either of those. Provision for bad debt to be increased to 30,000 at the year end. They didn't give percentage. They told, I want 30,000. Provision for discount on debtor, they want 2%. These are the 3 things which are new, which we have to discuss. Is it clear? Now, go and check and tell me, will this adjustment or rectification impact my debtor? Will this rectification impact my debtor? Good morning to everyone. It is goods purchased. How can it be impacting debtor? Sales return, if it is there, it would have impacted. It is not there. Correct? Okay. Now go and check. How much is your debtor balance? 4,57,000. 4,57,000 is our debtor. Correct? Now you have to check one thing. How much is the provision for bad debt that we already have? 25,000. Can you see 25,000 here? Provision for bad debt is 25,000. Now you have to check whether there is bad debt in the trial balance. Is there bad debt in the trial balance? 25,000. Bad debt, if it is there in the trial balance, what will happen? What will happen? It has to be subtracted from provision. Actually, bad debt, wherever it is, it has to be subtracted from provision. Correct? Okay. Minus bad debt. 25,000. With that, do you agree my provision became 0? My provision became 0. Now what? Now what? Provision became 0, no? Now anymore if I require for anything, do I have provision? No. Gone, no provision kali. But there is further bad debt of 7,000. Further bad debt of 7,000. I should reduce it from debtor. Bad debt. Sir, what is this, sir? Double standards. That 25,000 you did not reduce from debtor. But this is 7,000 you are reducing from debtor. Are you a Tala fan that only 7,000 you are reducing from debtor? What is the reason? That bad debt is already in the trial balance. That means they passed the entry bad debt account debited to debtors. Reducing from, good morning once again, reducing from debtor and reducing from provision have no connection at all. Don't tell me the answer that because it is reduced from provision, that is why we are not reducing from debtors. Guys, the entry for bad debt, again I am telling you, bad debts debited to debtors. This is the entry. Has to be passed, whether you have provision, no provision, whatever it is. Next entry is P&L debited to bad debts. Bad debts are an expense or a loss, has to be adjusted with profit. If you have provision instead of P&L, this will be PDD. This is what I am telling. So reducing from debtors have no connection with what you are doing here. First you have to create for you to do anything later. Are you getting this? Why did I not reduce here? Is not because it is reduced from PDD. I did not reduce because it is already there in the trial balance. If it is there in the trial balance, they have passed this entry. That's why bad debt came walking into trial balance. Are you getting this? So therefore, it is already reduced from debtors. This is sitting outside. If it is sitting outside, what has to happen? We have to pass the entry. If you have to pass the entry, it has to be subtracted 7,000. Are you getting this? When you pass the entry, it has to be subtracted. Now my debtors became 4,50,000. Do you agree? Now, what about the bad debt? Should I now take the bad debt from P&L or should I take it from PDD? I should take it from P&L because PDD Kali. With the earlier bad debt, only PDD got over. So now this 7,000 will be debited to P&L. Clear? Now they told at the end of the question, create provision for doubtful debts 30,000. They said provision for doubtful debt should be increased to 30,000. Forget increased, it became 0 there. So now you have to create another provision. That means provision required is how much? 30,000. P&L account debited to provision for doubtful debts. That means this also has to be debited to P&L. And in the balance sheet that will be reduced from debtor. So now your debtor will be 4,20,000. Do you agree? These are the people who I have hope on that these people will pay me. But those also when paying, no, they'll do some kirik there. What kirik they'll do? They'll ask me again for 2% discount. So what I'm doing again, I'm making one more provision, that is provision for discount on debtors at the rate of 2%. 42,000 into 2% is how much? 8,400. Final amount, this should be 4,11,600 in the balance sheet. Is this clear? These are the people who will do no kirik. Full amount I am expecting.
2%.
4,20,000.
Okay. Now, should this 8,400 also debited to P&L? How will you create any provision? You have to debit it to P&L. Now, look at the P&L. Where is our P&L? P&L, P&L. See here, provision for discount on debtors 8,400. Then provision for doubtful debts 37,000. Getting 37,000. How they have written 37,000? You know, it is 30,000 provision and 7,000 further bad debt. 7,000 further bad debt. Both they have clubbed and written provision for doubtful debts. Clear? You can write it as 2 bad debts and 2 PDD separately. Okay. Then in the balance sheet when you look, can you see their debtor in the balance sheet? The debtor started with 457 minus further bad debt minus provision for doubtful debts minus this amount 411,600. Are you getting this? Rest of the things are fill in the blanks. Rest of the things are fill in the blanks. I am not even discussing that. This was the twisted thing which we had to discuss. Is it clear? Yes, that's it, guys. Salary is actually only terminology. Salary is paid to employees. Wages is paid to workers. And workers are expected to be involved in the trading activity. That's why we put wages into trading account. If you have manufacturing, we put it into manufacturing account. Because those are the ones who are involved in the manufacturing activity directly. Now when we are talking about salary, they are indirectly involved in the activities. That's why they are sitting in P&L. Why have they clubbed salary and wages together in this question? No, right? Wages is wages is 15 lakhs, salary is 1.4 lakhs. Okay, I'll tell you. Okay, this is my factory. I'm manufacturing chocolates here. Chocolate manufacturing is happening. Clear? All the work is happening here. This is my office to pass journal entries. Understood? So here obviously the wages will be more. Depends on the kind of business. Yes, September done. Let's go into Jan. Was there a question in Jan? Final accounts. Here we go. Small question, guys. Small. Starts in India and ends in Pakistan. Not in Pakistan. Gone to Afghanistan. Now, I'll show you how small it is. See this. See the maja now. Value of stock as on 31st March 2024, 7,65,000. This includes goods returned by customer on 31st March 2024 to the value of 25,000 for which no entry has been passed. Ganguly. We will see that in Ganguly. Now imagine this is asked in the exam. You will see this and directly you will not even read it fully and you will be like Ganguly. And then in the exam they will be like excludes. This excludes. That time what will you do? You will take this value and add it to closing stock also. And your closing stock will be higher amount. And sales return entry same way you are going to pass. Clear? Now, purchase includes one furniture item purchased for on 1st January 2024 for 10,000. Depreciation 10%. Ganguly. Minus from purchases added to furniture. But when you are calculating depreciation, see the date. Next. 1 month's rent is outstanding and 12,000 is payable towards salary. Ganguly. As well as Gavaskar. Same adjustments. Did I tell you what is the importance of those two questions? Yes. Interest paid includes 9,000 paid against bank loan and interest received pertains to investment and deposits. Ganguly. Provide for interest payable on bank loan and interest receivable on investment and deposit. Ganguly. Make provision for doubtful debt at 5% on the balance under sundry debtors. Ganguly. When you are doing this, Ganguly, remember the sales return. Are you getting this? Insurance premium includes 18,000 paid towards proprietor's life insurance. This is Gavaskar, not Ganguly. What is missing from Gavaskar's question? Prepaid is not there. Robert is not there. In Ganguly's question, Robert was there. See? Can you see what has happened? 15 marks. When you saw the question, what you thought? Oh, so big. But everything is copy-paste. Okay? They won't give you questions like how they are asking in BCom case. Same name, same number. They won't ask that. Okay? So don't expect that level of copy-paste. But similar adjustments are asked. So if you have understood couple of questions, right? It's covering so many areas. Done with Jan 2025. Now we go into May 2025. Was there a question in May 2025 final accounts? Was it there, guys? It was there, wrong? 10 marks, huh? Last, huh? Only 10 marks? Yes, here we go. 10 marks. This question is SM. Just balance sheet will have more work, I told you. This question is study material question. Now, see over here. Balance sheet on 1st April 2024 is given. Okay, and this is the balance sheet. During 24-25, that means this current year, his profit and loss account revealed a net profit of 8,37,500. That means profit and loss account is already prepared. This was after allowing for the following. That means all these things are already taken care of. Commission paid to selling agent, discount received from creditor, purchase of a vehicle or of 62,500 on 31st March 2025. Okay, why did they tell 31st March 2025? That means there is no depreciation. Last day you purchase the vehicle. Depreciation on furniture and fixtures and vehicle at the rate of 20%. Done already. Okay, provision for doubtful debts at 3% of trade receivable as at 31st March 2025. But while preparing the profit and loss account, he had forgotten to provide prepaid expense and outstanding commission. Prepaid expense and outstanding commission. So what you have to do? Adjusted P&L. You have to again open the P&L. You need the adjusted P&L. And that will be the working note. Can you see? This is the profit. Prepaid expense actually subtracted from expense, but no expenses are there. Already expenses are taken. So to give the same effect, they have put it on the credit side. Outstanding expense over here. Outstanding expense should be added to expense. Done. This is the new profit. And this new profit which you found out should go straight into the balance sheet. Should go straight into the balance sheet. And the outstanding commission should be there in the liability side. And the prepaid expense should be there on the asset side. What happened? You raised your hand. That's why I thought there is doubt. Okay. Now, is it clear? Now, provision for doubtful debts. Okay, that also they have given directly in the question itself. What is the percentage? 5%. 3%. Take 1 lakh, 16 lakh 25,000 into 3%. Direct. It's direct. And furniture. Did they tell you, sorry, vehicle. Did they tell you that when new vehicle was purchased? So that has to be added to the opening balance, which is there in the opening balance sheet. But when you calculate depreciation, this should not be calculated on this because it is purchased on the last day of the year. So only on this they have to calculate depreciation. And depreciation on vehicle was at what percentage? Depreciation on vehicle was at 20%. So now if you calculate and see on this 3,43,000, calculate 20%. 343,750 into 20%. Can you see 68,750? That means depreciation is actually not calculated on this because it is purchased on the last day of the year. Furniture and all nothing. Directly on this only 10% is calculated. Clear? Now you're like, sir, from where did they get the value of inventory and all? Inventory and all value is given at the end of the question. His current assets and liabilities were as follows. Inventory, trade receivable, before provision for doubtful debt, cash at bank, trade payable. During the year, he introduced further capital. Okay. What will you do with this further capital? You will add it to balance sheet. Done. Where did you get this net profit from? Not the question. From the adjusted P&L. Rest everything is given. Done. 10 marks. Is it a bouncer? No, it is there in the study material. Same kind of question is there in the study material. Same structured question is there in the study material. Clear? Yes. Done with final accounts. Oh, that old RTP. Tell me the adjustment. Okay, I will tell you then. Now, there is one old RTP question. Somewhere 2018-19 somewhere. Listen. Bank OD is given. Let's say 80,000 it is. Bank OD is 80,000. Okay. No. I'm trying to recall that question. And they have told hypothecation of stock is done to get the bank OD. What does hypothecation of stock mean? That means stock is actually pledged, okay, to get the bank OD. And then they said 25% margin money is kept. 25% margin money is kept. That means, tell me one thing, if stock is 100 rupees, okay, only 75 rupees or 80% or something. Okay, let's find that question only. Do you remember the question? No, it is from RTP, but it's better to May 2018, very early. We'll do one thing is $28 on RTP rate. I don't have the RTP right now, but I have the material. Yeah, I took my question bank only. Page number 96. Here it is. RTP May 18. Okay, now what he's asking is this one. Bank overdraft is secured against hypothecation of stock. That means whatever bank OD is there, that is by pledging the stock. Bank overdraft outstanding on 31st March 2017 has been considered as 80% of the real value of stock, deducting 20% as margin. Deducting 20% as margin, and after adjusting the margin value, 80% of the same has been allowed as bank OD. So simple over here, what they are telling is right now, if I have some stock, right? If I have some stock, the bank OD that will be granted to you is 80% of that. Bank OD that will be granted to you is 80% of that. Is this clear? And whatever is granted to you, from that I have removed another 20% margin money, and only this much you have utilized right now. Are you getting this? Didn't get it. See, Can you see stock is, bank code is 80% of the stock? 80% of the stock. So whatever stock is there, we don't know what the stock is. In fact, this adjustment is given to find the closing stock. Okay, the stock, whatever is there, 80% of that you will get as bank OD facility. But out of that, deducting 20% as margin, that means they have kept 20% aside. It's like taking gold and going to the shop and telling I want a gold loan. If the gold value is something, do you think they'll give the exact value? They'll deduct something because they also want to stay on the safer side. So 80% they have given the facility, but they have allowed you to use only 80% of that. So they've removed another 20%. And now if you search this question, I think bank code is 80,000. Bank code is 80,000. So now here, this final resultant figure is 80,000 after deducting everything. So now what I should do? I should go backwards. That means this will become 1 lakh. I should go backwards. This will become 1,25,000. And 1,25,000 is our closing stock in that question.
We have taken the overdraft actually for 80,000 rupees.
We have taken the overdraft facility for 1 lakh rupees. But bank, what they did, they removed the margin of 20% and they allowed you to use only 80,000 right now. That means amount utilized right now is only 80,000. So if you want to know the actual facility, you have to go backwards. You will get 1 lakh. That means you add back the margin. Or you add back the margin. Then you add back and see what is the actual closing stock value. Clear?
The final 80,000 is for bank overdraft. 1 lakh is for bank overdraft
Facility. But that 1 lakh will not be relevant to us in our financials. Because our bank OD right now is only 80,000. Maximum amount limit is 1 lakh. But at this point of time, they will see your business level, right? They'll see what level of business you are in and then they'll slowly give the facility completely to you. Right now, they have deducted 20%. See, after deducting 20% as margin. So your closing stock is 125. Why did they give this point over here? Because closing stock is not given in this question. You have to find the closing stock and this will go to 2 places. Got it? Yes, that should be it, guys, with the final accounts. Very, very small chapter. Done. Next, let's proceed into a beautiful small chapter. Partnership. Into a beautiful small chapter called as partnership. I'll tell you what we have to do first of all in partnership. Concepts. All the concepts you have to complete. And then, after you complete all the concepts. Sir, if wages and salaries are clubbed, do we have to put directly into P&L? If wages is sitting first, then trading. Salary is sitting first, then P&L. Which is not the right methodology, but that's the methodology followed by ICA. Moment you have salary, it should go to P&L only because it's indirect. But what they're doing, if it's written as wages and salary, wages came first, trading. If they write it as salary and wages, then they'll put it into P&L. Now, we have to finish the concepts of this thing, partnership. Okay, I want you to write this, whatever we are going to do now. After that, then few questions, okay? Few questions, I'll tell you. Partnership. Okay. Intro. We have multiple units, no? From intro, you will have SM practice question 1. SMPQ 1. Then intro SMPQ 2. SMPQ 2. Then the next unit that we are going into is goodwill. In goodwill, we are going to have SM11. That is illustration 11. Then after that in goodwill, we are going into SMPQ 1. Clear? Then we are going into the next small unit that is called as admission. Admission. And admission you are going to take SMPQ2. SMPQ2. Then we are going into admission again and then we will take in admission December 2021 exams. December 2021 exam question. Then after that we go into retirement. One more small topic. Retirement. And retirement we are going to take SM5. SM5. Then in retirement SM practical question number 1. After that we still stay in retirement only SM Practical question number 2. Then we go into retirement, December 2023 exams. After retirement, next thing is death. In death, we are going to look at the practice question which is there. Okay, I think I have not written the PQ, one of the PQ. I think only one PQ is there, I think. Not sure. We have to search that, okay? Peter, Paul and Prince. After that, in death, you're going to see very small question from June 2023 exam. Very small question. Okay. Then after that, you're going to see the next topic, that is dissolution. And dissolution, you have to see PQ3. SM PQ3. Then you have to look into SM PQ2. SM PQ2. Then you have to look into illustration 8 for piecemeal. Then you have to look into illustration 7 for piecemeal. That's it. Then you have to look at past 4 exams. That's it for partnership. Only that much for partnership. Little. Huh? Little only we have in partnership. Silly chapter, no? Yeah, the past 4 exams. That is the last thing we are doing in partnership. Clear? only so much. 20 questions. Yes. But, huh? Today? I'm trying to. Can you see how much is there? Only little. Yeah, that is not a problem. Okay. Only little is there in partnership. See, this is it. And trust me, for your last minute revision, if you do this much, more than enough. Last minute revision is not exam day morning. Not exam day morning. It is last week. Last week. You can't see everything, no. This will cover everything. Let's begin. Partnership. First, we'll discuss all the concepts, okay? Okay? All the concepts of what? Yes. Intro, goodwill, admission, retirement, death, dissolution. All concepts we are going to finish. Then we will go and start solving problems. Okay, so all concepts of partnership at one time we are going to discuss. Once we do that, then we'll take a break for breakfast. Yeah, no. After discussing the concepts. Okay, after discussing the concept. Because if we take a break after solving questions, then we will be in lunch break directly. Okay, now let's start. Introduction. Shall we begin? Yes. Even if you tell no, I'm going to begin. Yes. Now, intro. Everything is important what you're going to see for the next half an hour. Okay, roughly next half an hour, whatever you're going to see, everything is important. All this will impact your question solving. Now, introduction. What on earth is partnership? Two or more people coming together to conduct business with an intention to earn profit. If two or more people would not get this idea of doing business together, one chapter would not be there in CA Foundation. Stupid two people could have done business on their own. They got this idea that let's do it together. Later, if they're doing peacefully, fine. They got this idea they have to admit one more guy. Admission came. They got this idea when one guy came, one more guy. They both were not seeing each other's face. So one guy retired. Retirement came. Seeing this tension, one person got heart attack. Death of a partner. Seeing all this, they thought Vastu only is not proper. Dissolution. Are you getting my point? When they were there, they were doing very good. So they created some reputation in the market, goodwill. That's it. That is partnership. Clear? Now, meaning. We already discussed partnership agreement. What is partnership agreement? You will tell, I want to do this work. I will tell, I want to do this work. Then later on, we'll fight. To ensure that that does not happen, mutually agree terms and conditions between the partners. Clear? Now, only if I and you agree and sign, and we call that guy, what is his name? What is your name? Huh? Charan. We call Charan to sign as witness. Okay, then later on, if you fight, we can't find Charan because he is exploring. Okay, we can't find Charan. So then there will be a problem. Therefore, what we do, we go and get this partnership agreement registered. We get this partnership agreement registered. Registered, that time it becomes partnership deed. Clear? It becomes partnership deed. Now you can't tell that I did not sign because you have gone and signed over there in their presence. So it becomes partnership deed. Now there are certain things. If you forget to mention in the partnership deed, then you go to the father. Who is the father? Partnership Act. You go and ask Partnership Act what to do. Then Partnership Act is telling do like this. So if you have not mentioned, profit sharing ratio will be equal. Clear? Interest on capital not there. Interest on drawing should be charged? No. Can we give salary or remuneration to partner? No. Interest on loan will be 6% only, maximum 6%. Now, you took loan from HDFC Bank. Okay, they are asking for 12%. But in your partnership deed, you did not talk about interest on loan. So now are you going to pay interest of 6% to HDFC Bank or 12%? 12% only. This is only between partners. HDFC Bank forget giving loan, they'll kick you out if you tell 6%. Clear? Interest on loan given by partners only 6%. Others are all whatever terms you have, that only you have to follow. Clear? Note. Interest on capital and salary to partners to be paid only if there is profits, unless mentioned otherwise in the partnership deed. What does it mean? That means interest on capital and salary you will pay. Okay? You told in the partnership deed that you have to pay, but you will pay only if there is profit. Even without having profit, if you have to pay it, there should be mentioned in the partnership deed. Is it clear? Otherwise, only if there is profit, you will pay. If it is not mentioned, if nothing is mentioned in the partnership deed, you will not pay only. Are you getting it? In the partnership deed, you have told we have to pay. Then you will pay. But only if there is profit. In the partnership deed, you have told you have to pay even if there is no profit. Then you will pay it at all times. Is this clear? Now, if there is an inadequate profit. What is inadequate profit? Insufficient profit, less profit. Okay. Then the available profit should be distributed in capital ratio. Available profit should be distributed in capital ratio. Now, for example, if I tell you A, B, C, three partners are there. They have 50,000, 30,000 and 20,000 as their capital. And that means our total capital is 1 lakh. Interest rate we have told is 10%. 10% of 1 lakh should be 10,000. I have only 8,000 profit. My profit sharing ratio actually is 1:1:1. Can I distribute in the ratio of 1:1:1? No, this is not profit to distribute. This is interest on capital. Interest on capital is given on capital. That means whatever available profit is there, distribute in the ratio of capital. That is 5:3:2. Is this clear, guys? Are you following this? Yes. Let's go further. Capital account maintenance system. Capital account maintenance system. We have something called as, yes, Charan, here we are. We have something called as morning I am high, afternoon you are high. So let's compensate like that. Okay. Now fixed capital method. Now fixed capital method means what? That means capital is fixed. Don't touch the capital at all. Whatever extra things you want to put into partner's current account. So fixed capital method, you can see only capital introduced and capital withdrawn, not drawings, capital withdrawn, okay, to be entered in the capital account. All other transactions to be entered in the current account. What are the other transactions? Interest on capital, interest on drawings, salary to partners, profit or loss share, etc. to be entered in partner's current account. Is this clear? Are you getting this? Now, what if it is fluctuating capital method? All in one. All in one. Everything you will enter into capital account itself. All transactions related to partners to be entered into partner's capital account. Okay, all these transactions over here will be entered in the partner's capital account itself. Note, if question is silent, then it is fluctuating capital method. If they don't tell anything in the question, it is fluctuating capital method. But in the question, they didn't tell anything. But in the balance sheet which is given in the question, there is capital account, there is current account. Then what is it? It is fixed capital method. Is it clear? No. Difference between drawings and capital withdrawn. What is drawings? What is capital withdrawn? You took the money that you gave. What is drawings then? You took the money that you gave is capital withdrawn. What is drawings? Money taken from profits. Money taken from the amount that belongs to business for your personal purpose. That is called as drawings. Clear? Now, drawings is amount taken by the partner in anticipation of profit. You know, by the end of the year, we'll have a lot of profit and that profit belongs to you, right? So what you have done during the month, every month you have some expenses. So you can't wait till the year end. So you will take every month little for your expenses. This is called as drawings. Capital withdrawn is what? When I started the business, I gave 1 lakh capital. Now I told, give 20,000 out of that back. 80,000 enough. I want to put only 80,000 into this business. Okay, amount taken by partner out of capital introduced by partner. No interest is charged on this. But on drawings, obviously interest may be charged. Interest may be charged. Here you cannot charge interest. He has taken his own money back. How can you charge interest on that? But here he has taken the money that belongs to business back. So that's why interest will be charged. Now tell me one thing. Here interest will be charged till when? Interest charged till when? Till end of the year. Till end of the year. Why? End of the year, this will get adjusted with the profits, no? In anticipation of profit, you have taken early. That means you have taken early. Early means before the year end, you have taken whatever is there, interest will be charged till the year end. Is this clear? Sir, if HDFC Bank itself is a partner. Yes, then 6%. Okay, then 6%. Okay, now interest on capital. Interest on capital, how you are going to calculate? Capital into interest rate into time duration. Now, which capital you are going to take to calculate interest on capital? Always the opening capital. There are some RTP questions, which we might not discuss in marathon. You have to go and see. There are some RTP questions where they have given closing capital and they are told calculate interest on capital. Directly you can't apply. What you have to do? If drawings is there, reverse. If additional capital is there, reverse. Then you will get opening capital. On that you calculate interest on capital. Is this clear? Now, example you see. There is one partner A has capital of 1 lakh. Interest rate is 10%. So capital introduced is 50,000. When did he introduce this capital? 1/1/2022. Clear? And 1/4/2022, what did he do? 1/4/2022, you are going to calculate interest on capital 10% on this. Can you see we have taken full 10% on this one? But on this 50,000, can you see 9/12? Actually, this date should have gone here. And 1/4/2022 is for the capital introduced. So 9/12, that time you get 13,750. So simple. If capital is withdrawn, what will we do? Capital is withdrawn. Now, for example, if I tell you 1 lakh capital, there's no interest, correct. But if I tell you capital is there on 1/1 and additional capital of 40,000 we have put on 1/4 and there is 30,000 capital withdrawn on 1/10 and the interest rate I am telling you is 10%. Interest rate is 10%. Now, what will I do? Till the date, yes, that is 1 lakh into 10% into 12/12. Correct? That is basically 10,000. Then here 40,000 into 10% into 9/12. That makes it 3,000. Clear? Then 30,000 into 10% into 3/12. 750 minus 750 will be subtracted. Are you getting my point? Because on this you have given full year's interest. On this you have given whatever balance interest was there. Now if they have taken, that interest should not be given. So that interest will be reduced from the existing interest. So that is why if there is capital withdrawn, it will get subtract it. Is it clear? Now, next, interest on drawings. There are multiple cases over here. Okay, the cases are drawings on different dates and different amounts. No pattern, nothing. If there is no pattern, 2 days you are studying, then 1 day you are not studying, then again you are studying, morning you are studying, then again you are studying in the evening, then 1 day you are not studying, then again you are studying in the afternoon. Is there any pattern? No pattern, right? So that time what you will do, just take the dates, calculate the interest. For example, if I tell interest rate is 10%, 20,000 into on 1/1/2022, then 20,000 into 10% into 12 by 12, full year. But 30,000 on 1/7/2022, that means middle of the year, so 6% interest, 6 by 12 interest. Clear? Are you following this? No pattern, but there is a pattern now. Same amount every month at the beginning of the year. Beginning of the month. What should be the pattern? Same amount every month, beginning of the month. Then what will you do? 6.5 divided by 12. That is total drawings into interest rate into 6.5 divided by 12. Now in the question, if they tell 1000 per month at the beginning of the month, you can't do 1000 into, you have to do 1000 into 12. Take total drawings. Don't make the mistake of taking only 1000. Then no, again it is wrong. 1000 into 12 into 10% into 6.5 divided by 12. Clear? Now what if they tell same amount every month at the middle of the month? Formula remains same. You'll use 6 by 12. Middle of the month. So it will become 1000 into 12 into 10% into 6 by 12. If they tell same amount every month at the end of every month, that means same thing, but you will make it 5.5 divided by 12. Now you understood, no? If there is different dates, you will apply individually and you will calculate same amount every month starting, same amount every month middle, same amount every month end. You will use the formula. Now all this you learnt and went to the exam, and in the exam they said total drawings 5,000. 6 by 12. Because your natural assumption is that it is evenly drawn during the year. So if they tell the last case total drawings as mentioned in the question, then date of drawings not mentioned, then you will take 6 by 12. That means you are naturally assuming that it is evenly. You are like, sir, why can't I just do total drawings into rate? If I do total drawings into rate, that means I am assuming that drawings is made at the first day of the year. If I am charging interest for full year, that means my natural assumption is drawings is made on the first day of the year. So if they don't tell you dates and they just tell you drawings, it always has to be 6 by 12. Is it clear? Yes. Let's go further. Minimum guaranteed profit. Imagine you have two people, Akhilesh and Manju. They decided to start software business and they told, we don't know anything about software. Even spelling of software, we are telling SOFT, VARI. Okay, so that then we got to know that it's not possible. We cannot do anything. Okay, so they decided that they will contact, we are in Bangalore only. So we'll contact one old person called Narayan Murthy. Okay, anyways, he is telling that 70 hours in a week we have to work. So he also might not be working 70 hours. So we'll call him and tell work with us for 70 hours. Clear? We introduced him as partner. Now, do you think that Narayan Murthy will be willing to bear any loss in your partnership firm? No. So when he's coming only, he's telling, I have to get one minimum guaranteed profit of 5 lakhs. Minimum guaranteed profit I should get 5 lakhs. Is this clear? Now, the question, whenever you see minimum guaranteed profit question in the exam, your immediate reaction should be, tell me who gave the guarantee. No, you should think like that. I'll tell you. Who gave the guarantee? Did the firm give the guarantee? Did one partner give the guarantee? Or did both the partners give the guarantee in some ratio? This you have to identify. If the guarantee is given by firm, that means for the firm, who is the bigger person? Narayan Murthy. For the firm, who is the bigger person? Narayan Murthy. So when they make 10 lakh profit, first they will give it to Narayan Murthy directly. They'll give 5 lakh directly to Narayan Murthy. Then what they will do? Balance profit they will share between Akhilesh and Manju. Is it clear? If the profit is given by the firm, if the guarantee is given by the firm. Now my question is, what if the profit is 1 crore? What if the profit is 1 crore? Narayan Murthy's share is what? 1 by 6. 3:2:1. So 1 crore into 1 by 6. Are you getting 16 lakh? 66,667. Now, should I do anything about minimum guaranteed profit? Because if I just distribute also, everybody is getting more and Narayan Murthy is also getting more than the minimum guaranteed profit. Sir, but minimum guaranteed profit is 5 lakhs. So I should not give him 16 lakhs. That is minimum, not maximum. Minimum is 5 lakhs. So if it is more, he will also be happy. You will also be not sad. Are you getting my point? Now, so if the guarantee is given by the firm, just remember, if guarantee is given by the firm, for the firm, you both are just natural persons. For the firm, Narayan Murthy is artificial person. Clear? So first entire amount will be given to Narayan Murthy, whatever is the minimum guaranteed amount. Balance, if something remains, like how your PG food, if something remains, that will be given to you. Is it clear? Same thing is happening, no? Yes. Guarantee given by partner. Guarantee is given by partner. Then you have to identify who gave it. Akhilesh gave it. Guarantee is not given by firm. Who gave the guarantee? Akhilesh gave it. Now firm doesn't know about this, or firm is not concerned about this. Now what firm will do? Distribute the profit to everybody. What will firm do? Distribute the profit to everybody. Now who gave the guarantee? Akhilesh. Can you see Narayan Murthy is not getting 5 lakhs? So what will Akhilesh do? Remove from his share and give it to Narayan Murthy to make his profit share 5 lakhs. Is this clear? When the guarantee is given by firm, then firm only will distribute first to Narayan Murthy, then distribute to others. When guarantee is given by one of the partners, firm will just distribute to everyone. Then if there is shortage for Narayan Murthy, then that partner will remove and give it to this person. Clear? When guarantee is given by the partners in ratio of 2:1, guarantee is given by whom? Partners. What was their profit sharing ratio? 3:2:1. They are not agreeing in their profit sharing ratio. For this guarantee, different ratio, 2:1. So now what happens? Firm doesn't know about all this. They will just distribute the profit to everybody. Is there some shortage? This shortage will be given by the partners in the ratio of 2:1. Is this clear? So these are the 3 situations which you can see in minimum guaranteed profit situation. Clear? Done. 1 unit got over.
The total profit is itself like 3 lakhs. Then
If total profit is 3 lakhs, then 3 lakh will be given full to Narayan Murthy, and the other partners will bring money and give it to Narayan Murthy to make it 5 lakhs. There is no other way. We have agreed that it should, in fact, if it is loss will be borne by the other partners, but they'll have to fund the money to give this person 5 lakhs. Yes, done guys. In fact, they might not bring money. Literally, they might not bring money. What can happen is like how we do goodwill adjustment. No, it will be removed from this person's capital account and will be put into that person's capital account. But in fact, when he tells that, okay, you put into my capital account, I want to withdraw the money. If there is no bank balance, these partners have to bring money. Okay. Next, goodwill. Very small area of it is like unit 2. Why you have to worry? Right? Directly we can go to unit 3. Gone. Okay, forget unit 2. Directly we'll go to unit 4. Gone. Okay, forget. Directly we'll go to unit 5. Gone. Only thing you will be able to do without goodwill is dissolution. That is because you don't have goodwill. Are you getting my point? Because there is no reputation, only you are doing dissolution. So without goodwill, if you are going into partnership, only dissolution you can study and go to the exam. Is this clear? Now, goodwill. Okay, in this basics, right? One thing I have not discussed or written over here is P&L appropriation account. P&L appropriation account. Now, I don't know only, okay, how to prepare this. I am going to ask you. When you tell no, I'll fill this. Okay, I don't know what is this P&L appropriation. I know only till P&L. I don't care about insider, only outsiders. Clear? Now, how will my P&L appropriation start? Profit should come. From where will the profit come? From P&L. So I'll write by net profit brought down. Is this clear? By net profit brought down. Now, after that, I want to give salary to partner. What should be the entry? Yes. No to salary. What to salary? If I write to salary, salary will be credit. That means income for the firm. Here you will write to partner's capital or current account. Whether it is salary, whether it is interest on capital, whether it is remuneration, whether it is called as commission, whether it is called as bonus, whether it is called as profit share, everything will be same entry. P&L appropriation account debited to partner's capital account. There if you want, you just write by P&L appropriation. Under that you write just for description purpose. If you don't write also, it's not wrong. Just for telling what it is you write. There is no writing by interest on capital or to interest on capital. Now, ICA doesn't follow consistency. We know that. Okay. They will tell randomly, random places. Some places they'll just write to interest on capital. If you write to interest on capital account is getting credited. If it is getting credited, that becomes an income account. Are you getting my point? So, therefore, basic logic is profit is remaining. Are you getting this? Removing, putting. Putting where? To partners, capital or current account. How do I decide which one, capital or current account?
Question on balance sheet, there will be
Yeah, if it is fixed capital, it'll go to current account. If it is fluctuating capital, it'll come to capital account. Now, tell me one thing. All this done. Drawings. What is the entry for drawings? By. Correct. Drawings will not come to P&L appropriation at all. Good morning. Because drawings entry is drawings account debited to bank. Then then capital account debited to drawings. Why will it come to P&L appropriation? Drawings will not enter at all. This area only drawings will not enter. It will go to the other area. Are you getting my point? Interest on drawings just entered the area. Clear? So now you'll write by P&L appropriation. By P&L appropriation, you'll write, sorry, what am I writing? By partners capital or current account, you'll write interest on drawings, because interest on drawings you're taking from the partner. So partners capital or current account has to be debited. Clear? Done. This is it. This is P&L appropriation. Clear? Are you following this? Yes. Hello? Yes. Goodwill. When is the exam? September 16, right? Yesterday was 1 month. Exact 1 month was there for accounts exam. That's it. 30 days. Now you have 30 days left. Huh? 29 days. More than enough. I'm telling you, more than enough. It's more than sufficient time is there to clear CA foundation exams. But you have to study, that's it. ICA can't do anything. God also can't do anything. You have to study. Do you do prayers when you study? Should you do prayers? Any atheist people over here? 1, no? 2. That's it. Rest everyone believes in God. For which one you raise the hand? Okay, now should you pray? Yes, you should. I'm telling you, you should. But when should you not pray, I'll tell you. On the result day. When should you not pray, I'll tell you on the result day. Because that day God also can't do anything. Because previous day only I uploaded the results. Okay. Previous day only. Are you getting my point? So if you're praying, no, you should pray now. So that whatever you study remains in your memory. You get peace of mind. You don't get distracted thoughts. Okay, you can fully focus on exams. That is what you need to pray for. Okay, then after the exam, you need to pray every day. Okay, because whatever you write, let that person come with very calm mind frame to correct my paper. Small mistakes and all, let him ignore. Okay, big mistakes, let him not see it only. Okay, so that is when you need to pray. But after that, on the result day, I know you will do temple run on the result day. But on the result day, actually, it doesn't make much difference. Exam, when you go early, you can just say a prayer just to calm yourself, calm the nerves. Okay, because moment you start looking that side, this side in the exam hall, no, you'll start panicking. You'll see one guy flipping pages at the speed of light. Fully, he'll be flipping pages like this. You'll be like, how is he revising so fast? I was not able to revise 10 pages today morning. Are you getting my point? One more guy will be there sitting without even getting any book. He's like, this guy finished studying everything. And then you'll panic. So basically you see anyone doing anything, you'll panic. So basically don't look at anyone. Just close your eyes and sit there. Wait for them to start distributing the paper and reading those instructions. Ignore those instructions also. Simply they'll be reading those instructions for 5 minutes and wasting everyone's time. We'll be remembering some formula or something. They will go on reading those instructions. Yes. Now, goodwill. What is goodwill, guys? Reputation. What is goodwill? Reputation. Reputation of the business. Now, should goodwill be shown in the balance sheet? No. ICA only will tell many times don't show goodwill in the balance sheet. Goodwill should be there, but it should not be shown in the balance sheet. Is it clear? So now, goodwill is always going to be adjusted in partner's capital account. Let's see what is the factors affecting goodwill. Okay, what are the factors affecting goodwill? First, we have location. How location can be there? One guy was there, okay, Soyam, and one more guy was there, Bambani. Okay, Soyam was standing right next to Christ College. Not like how you are standing, he is selling ice cream. Not for the purposes that you are standing right next to Christ College, he is selling ice cream there. Okay, right next to Christ College. Even if his ice cream is okay, even if his ice cream is okay in quality, do you think it will get sold? Yes, because his reputation is location. Location is increasing his goodwill. Clear? Now, imagine Bambani got to know and he also came and stood next to Christ College. Neutralized. Now, Bambani is very arrogant. Okay? If you give him, if you ask for anything also, he will act like he is giving the ice cream for free. There are some shopkeepers, no, they'll take and keep it like this. Are you getting my point? Okay, this happened to me. First time I went to Chennai, right, to take classes. Okay, I can understand Tamil, but I can't talk. So now when I went to take classes, right, I went there to the shopkeeper. I wanted to buy something, biscuit or something I wanted to buy. So now I don't know what language to talk. So I thought English he might not understand. So I spoke in Hindi. Okay, I spoke in Hindi. He took the biscuit, didn't even keep it. He threw it on the shelf like that. Okay, then I'm like, why is this guy so rude? And I'm like, okay, Hindi is not working. Next day I went and I spoke in English. He took again and he kept it like this. Okay, again he was rude. Then third day I thought, okay, I have to speak in Tamil, this guy, but I don't know Tamil. I'm like, I will see, your rudeness I will see. Okay, I went and I spoke one full 2 sentences in Kannada. Okay, I told full sentences in Kannada, give me that, give me this, in Kannada I told. He got stuck like this. Then he gave me biscuit. Okay, and he replied in Kannada. Then I got to know, this guy actually can speak little bit of Kannada. But if you talk Hindi and English to him, he gets angry. Then after that, I used to, whenever I wanted, no, there will be one full crowd. I used to go and talk in Kannada, he used to give me first. But if you talk Hindi, you're gone. They get, huh? No, you were CSK fan only. Because we were going for RCB versus CSK match. That time we were wearing RCB jersey and going. He saw us. He was angry. After that, I didn't go to buy biscuit. We watched RCB versus CSK match in Chepauk only. And luckily RCB won that day. Luckily. Because we were the only 2 people in that entire that part of the stadium, right? We were the only 2 people who were wearing RCB jersey. Full yellow. When they lost it, they were sad. So they didn't go to do anything. But previous match, I know someone who went there. CSK versus Mumbai Indians was the previous match, which CSK won. And people who went in Mumbai Indians jersey, right? They made them come out of the stadium in banyan. Literally. They made them remove that t-shirt and they had to come just in banyan outside. But that day RCB won, right? So they were, huh? If it was not, we were ready. We were wearing banyan inside. We were prepared for it. Because RCB had not won from a very long time in Chepauk. So we were also not completely confident. But the way we were shouting, right? I was feeling bad for the CSK fans. I had one more sir with me. He was more bigger RCB fan. He is shouting like when every wicket of CSK is falling, right? He is like, yes, now Dhoni will come. Oh, Dhoni didn't come. Then one more wicket, yes, now Dhoni will come. Dhoni came late. Then full match was over. Okay, then after the match was completely gone, then he hit 2 sixes.
For Krunal Pandya.
For Krunal Pandya, yes. So, that was the day. That was exactly before the previous marathon. Yeah. After watching match, I came directly to the marathon itself. Like late night or early morning flight I took and I reached here. Okay, now, hello, but that's why, to avoid conflict, I brought Bambani. Mumbai Indians. Mumbai Indians. CSK fans also like Mumbai Indians. RCB fans also like Mumbai Indians. What you're shaking your head? No. CSK fans like Mumbai Indians. That I got to know this year. When CSK was eliminated, that time CSK fans are like, Mumbai Indians should win. Cousins. They were telling cousins. Because they also have 5, we also have 5. No? So many CSK fans. When CSK was eliminated, they were supporting Mumbai Indians. And Mumbai Indians also got eliminated in eliminator. Then they started supporting Punjab. Punjab, I knew Punjab, it is very difficult to win. Because Punjab has more bad luck than RCB. RCB at least qualifies. Okay, Punjab, most of the time they'll be fighting for last spot only. And Punjab has fans because of owner. See, I just told owner. From morning, one answer he has not given. When I told Punjab owner, moment. And SRH also has fans because of owner. See, RR also has fans because of owner. Who is the owner? See, he doesn't know. RR owner, he doesn't know. But Punjab owner and Sunrisers owner, he knows. Sunrise owner, you know it is. Before, what was it called? Deccan Charges. Okay. So, we get Bambani. Okay, we don't get anyone into the story. Wait a second, guys. Small. Now, so Bambani got to know. Okay, Bambani got to know about this. He also came next to the college. Now, Bambani, whenever you ask him something, right? He is very arrogant. But Soyam, whenever you ask him, no, he is always having a smile on his face. He'll give you with a smile. Same product. Now, will you go to Bambani? Will you go to Soyam? Soyam automatically. That means customer satisfaction was one of the reasons for his goodwill. Clear? Now, reputation of owner. You got to know Bambani is having one ice cream brand. Okay, now we removed Bambani from here and we got Babu. We got Babu. And we got to know that Babu is actually the owner of Baskin Robbins. Baskin Robbins. Now, ice cream might be tasting same, but still will you go to Babu? Because you know that owner has reputation. Okay, now here also Soyam bought one more person with reputation, so it got neutralized. So, uniqueness of product. Now, Soyam has one ice cream which is patented. Nobody can make that ice cream in this entire world. Different taste. So, will you go to that person just because of that unique taste? Yes. These are the factors which are affecting goodwill. Clear? Now, computation of goodwill. We'll bring back Bambani, okay? Women. Bambani is not fat. He's healthy. Don't be body shaming like that. Okay. Yes. Computation of, he stored some money in his stomach. That's it. Only some 2,800 crores. 2,800 lakh crores. Some lakh crores he has. Sorry. 6 lakh crores. His net worth. Somewhere around that. He spent 2,800 crores for the wedding. That is small amount. Chillare for him. Yes. Because if 600 lakhs, if you remove lakhs, or it's not 600 lakhs, what? 6 lakhs crores. If you remove crores, it is 6 lakhs. 2,800 crores. If you remove crores, it is 2,800. So out of 6 lakh rupees, will you spend 2,800 for a wedding? Yes. Simple. You will borrow 20 lakh loan and you will do the wedding. That is a small amount for him. He gave 1 lakh just like this. I mean 1 crore just like this. Nothing. He bought some watch and all and gave 1 crore ka watch. That is when I felt that we should have actually become some small content creator. Because then we would also get invitation for that. Then you would get 1 crore ka watch. I will sell it for 2 crores after coming. I'll tell Bambani's wedding watch. Are you ready to buy? There will be some people in auction, they'll buy it. I'll sell it for 2 crores. Who wants to wear 1 crore ka watch? Mad what? I'll not wear 1 crore watch and go in Bangalore traffic and all. For that watch, somebody may cut the hand itself. I don't want to lose the hand for the watch. Okay, they will wear 1 crore watch because they are going with Z security, right? If you go 1 crore ka watch, and if you go, and especially you go in some areas of Bangalore, right? I don't want to take the names. Some areas of Bangalore, if you go, right, you will not come out of that area with that 1 crore watch. Either you have to remove 1 crore watch and give it to them to come out. Otherwise, you will come out like this. Yes, computation of goodwill. Yes, good morning. Computation of goodwill. Average profit method. You should know the formula. I am not going to tell you the formula. What is the formula for goodwill? Total profit divided by number of years I am hearing. That is not the formula for goodwill. Goodwill is equal to average profit into number of years of purchase. Where will number of years of purchase be given in the question? Average profit you have to find out. Total profit divided by number of years. Is this clear? Now, what does number of years of purchase mean? How many more years you are expecting your reputation to continue? That is number of years of purchase. This one and this one are not the same. This number of years is past years what you are considering for calculation. This number of years of purchase is future years which you are maintaining. Sometimes that also might be 3, this also might be 3. Sometimes that might be 4 and this might be 2. Clear? Don't interchange these numbers. Need not be same. Weighted average profit. Goodwill is equal to weighted average profit into number of years of purchase. Number of years of purchase will be given in the question. How will you find weighted average profit? Total product divided by total weights. How will you get total product? Product is always profit into weightage. Multiply the profit into weightage, you will get the total product. Weightage, what you will do? You will give highest weightage for the most recent year. Now imagine I have year 2020, 2021, 2022 and my profit is 5 lakhs, 6 lakhs and 7 lakhs. Now what weightage will you give? My weightage will be what? 1, 2 and 3. Is that correct? 1, 2 and 3. Correct. Imagine my profit I change from 7 lakhs, 6 lakhs and 5 lakhs. Now what will be my weightage? It will still be 1, 2 and 3. It has nothing to do with increasing or decreasing. Weightage is always given, highest weightage to be given to the most recent year. Is it clear? Now, weighted average profit is used when there is trend in profits. Okay. Trend can be increasing or decreasing. It can be increasing profit or decreasing profit. But ICA doesn't follow consistency. If there is trend in profit also, but if ICA doesn't tell you, simply follow simple average only. You are actually supposed to follow weighted average. But ICA, some places they follow, some places they don't follow. So to avoid all that, if there is no trend in profit, then you know simple average. If there is trend in profit, it always has to be weighted average. But if ICA doesn't tell, then you follow simple average itself. Is this clear? Next, super profit method. What is the formula for goodwill under super profit method? Goodwill is equal to super profit into number of years of purchase. Again, number of years of purchase will be given in the question. What is super profit? The profit that you are making extra compared to others. So average profit minus normal profit. Average profit you already learned how to calculate. What is normal profit? Capital employed into NRR. Capital employed will be given in the question. NRR also will be given in the question. NRR is normal rate of return. What does NRR mean? That means normally what people are supposed to earn with this much capital. Are you earning the same amount? No, you are earning something extra. That means you are earning extra because of your reputation, goodwill. Clear? Last method is capitalization method. Here goodwill is equal to normal value of business minus actual capital employed. Actual capital employed will be given in the question itself. What is normal value of business? Average profit divided by NRR into 100. That means to earn this profit, how much others have to invest? That is normal value of business. How much have you invested? That is actual capital employed. So if you are earning the same amount of profit with lesser capital, that means that is your goodwill or that is your reputation. Is it clear? Now, accounting for goodwill. Always, sacrificing partner will be compensated by gaining partner. Sacrificing partner has to be given. Gaining partner will be the one who is going to give. And you are going to use only one ratio. I don't know gain ratio at all. We are going to use only one ratio, that is sacrificing ratio. Sacrificing ratio is old ratio minus new ratio. Because if you learn two formulas, then you will be confused where to apply which one. So let's stick to only one formula, that is old ratio minus new ratio. What is the formula old ratio minus new ratio? Sacrificing ratio. When you are calculating that, If you get a positive number, that means it is sacrifice only. If you get a negative number, that means it is gain. Clear? Just like when you started with OD, if you end with positive number, that is OD only. If you end with negative number, that becomes normal. That means use this formula only, that is old ratio minus new ratio. If the answer is positive, that means that person is sacrificing. If the answer is negative, that means that person is gaining. So whoever is coming with a negative number over there, that person is supposed to pay to the sacrificing partner. Is it clear? Now, note, when computing profits, for computation of goodwill, profit or loss not expected in future must be eliminated. That means they call this as abnormal profits. In future, in the past, there was loss by fire. Do you think that fire will happen again in the future also? No, that should not be considered when you are calculating profit. In the past, you sold some assets and got profit. That profit, are you expecting again and again to happen? No. The logic is simple. Loss by fire did not happen because of your reputation. Remove it. Profit on sale of fixed assets did not happen because of your reputation. Remove it. You are considering only that profit which has come because of your reputation. So only that profit will be used for calculating goodwill. Is it clear? So abnormal items, whatever is there, it has to be eliminated. Now, accounting for goodwill in different circumstances. 1. Admission. In case of admission, what happens? New partner brings in money for capital and goodwill share. They'll tell new partner brought money for capital also, for goodwill also. What will you do? When you get the money, first you record the money. Bank account debited because money came in. Who gave that money? New partner. To new partner's capital account, capital and goodwill both you put into his capital account. Then what you will do? Remove from his capital account. Gaining partner's capital account debited to sacrificing partner's capital account. Who has to give to whom? Gaining partner has to give to sacrificing partner. That's why remove from gaining partner's capital account and put it into sacrificing partner's capital account. Okay, and this will be done in which ratio? Sacrificing ratio. No new profit, no old profit sharing ratio. Sacrificing ratio. Now, if new partner brings in money only for capital, he's like, I am not bringing money for goodwill and all. I'll bring money only for capital. That time, what will you do? No problem. Whatever you want, you bring, but I will still take the goodwill share. That means bank account debited to new partner's capital account only capital, but then still you will pass this entry. That is gaining partner's capital account debited to sacrificing partner's capital account. Are you following this? So whether the partner brings or not, goodwill share has to be distributed between gaining partners and sacrificing partners. Now, amount of share of goodwill of sacrificing partner, if withdrawn by the partner. If the new partner, partner whoever is sacrificing, they got money. They saw money come and fall into their capital account. They're like, let's take it and go on a trip. If they withdraw it, what will happen? Partner's capital account debited to bank account. Money gone, partner's capital account debited, and bank reduces because asset is reducing. Clear? If new partner pays sacrificing partner share of goodwill privately, new partner is telling, don't worry, I'll come to your house and give every day head massage for 1 month. Okay, that time it is happening, something is happening privately. Okay, nothing to be recorded in books of accounts, no entry. No entry for goodwill. Is this clear? Now, accounting for goodwill in different circumstances, retirement, death, change in profit sharing ratio. So retirement and death I can understand, sir. Somebody is going. But what is this change in profit sharing ratio? Yesterday we had 10 dosas and each of you, 5 of you are there. Each of you were getting 2 dosas. Today also we have 10 dosas. But one person is taking 3 and others are getting 1. Okay, somebody will get 2. Don't worry. He's like, how did it total up to 10 now? Okay, one person is taking 3, one person is taking 1, one more person is taking 2, 4, 6, 8, 10. Clear? Now, can you see that one person is sacrificing, one person is gaining? Is there any admission? No. Same number of people. Is there any retirement? No. Same number of people. Is there any death? Same number of people. That means just if you change the profit sharing ratio also, there can be somebody who is sacrificing and somebody who is gaining. That's why whenever you have a situation of partnership, do old ratio minus new ratio, you'll get to know who is sacrificing. Okay. Gaining partner's capital account debited to sacrificing partner's capital account. That means adjustment of goodwill, whether you are in admission, retirement, death, or just changing profit sharing ratio, the entry will always be this. Clear? That means goodwill cannot go and sit in the balance sheet. Next. Let's go further. Admission of a partner. Admission of a partner. New partner being admitted into an existing partnership firm. Oh, that's it. New partner is admitted into existing partnership firm. That means one partner is waiting at the door. One partner is waiting at the door. Someone is standing at the door. We will not open the door. We will not open the door until and unless certain things are done. First, compute the new profit sharing ratio. If new profit sharing ratio is given in the question, be happy and go to the next step. Compute the sacrificing ratio. Compute sacrificing ratio. Now, I'll tell you one general tip over here. Sacrificing ratio is old ratio minus new ratio. If they tell A, B, C are partners with a ratio of 3:2:1 and they tell new partner is admitted A, B, C, D now 3:2:1:1, then no need to calculate sacrificing ratio because it will be in the ratio of 3:2:1 only. Between these three people, 3:2:1. Now also between these three people, 3:2:1. So you don't have to worry about anything. This will be your sacrificing ratio. So whenever they tell no in the question, if they tell like this also, A and B are partners, 2:1 is the ratio. They tell C is admitted. C is admitted for 1/5 share. Have you seen these kind of adjustments very commonly? If they tell C is admitted for 1/5 share. So what you do that time when you calculate new profit sharing ratio, 4/5 share is divided between others. If C is admitted for 1/5 share, that means 4/5 is distributed between A and B. That means in this kind of an adjustment also, the sacrificing ratio will be same as old ratio, that is 2:1. Clear? 2:1. This is for you to save time. Clear? If old ratio and new ratio are going to be same between those partners, then sacrificing ratio inevitably has to be same. It cannot change. Now, after that, what you'll do, compute goodwill. We know the methods: average profit, super profit, capitalization, or weighted average profit, anything you're going to use. Then you're going into revaluation of assets and liabilities. Did that person enter the door? Still he is at the door only. Correct? Why we are not opening the door? Because we have to even finish revaluing the assets and liabilities. Why are we doing revaluation of assets and liabilities? Because whatever profits are there or losses are there should belong to old partners. Asset value increase, decrease, liability value increase, decrease has happened before that person who is standing at the door has come. That means whatever it is, it belongs to old partners. Clear? Now, if it is increase, I don't want to give him. If it is decrease, I would like to give him, but he will not be like agreeing to bear it. If it is increase in asset value, that profit I want to keep for myself only. I will not allow him to enter. If there is decrease in asset value, I would allow him to enter, but he will not enter. He'll be like, why should I enter and bear the loss which happened before I came? Clear? So always revaluation of assets and liabilities should happen. Now, understand this. If asset value increases, what is the entry? Asset account debited to revaluation account. If asset value decreases, revaluation account debited to asset account. Liability value increases, revaluation account debited to liabilities account. Liability value decreases, liability account debited to revaluation account. Now understand this. You can think of this, if you forget it in the exam, you can think of it from modern approach point of view. That is asset increase, debit, asset decrease, credit, liability increase, credit, liability decrease, debit. That is one angle. Other angle you can think asset increase, good for you, profit, credit. Asset decrease, bad for you, loss, debit to revaluation account. Liability increase, bad for you, debited to revaluation account. Liability decrease, good for you, credited to revaluation account. Are you thinking it in any angle? You think you'll still get the correct answer only. Now, whatever profit or loss is there in revaluation, that should be distributed to whom? Partners. Which partners? Old partners. In which ratio? Old profit sharing ratio. Revaluation account debited to partners capital account. If it is loss, you have to take it from partner. So partners capital account debited to revaluation account. Is this clear? Note. If they tell in the question, assets and liabilities are to be shown at original values after revaluation. In some questions are there in partnership, 3-4 points they'll print okay about revaluation. Then 5th point they'll tell that partners have agreed to show the assets and liabilities at book value. Then why did you tell me all these revaluation points? Are you getting my point? In such cases, you will prepare something called as memorandum revaluation account to be prepared. Memorandum revaluation account means what? Whatever you have done, we have to reverse it now. Clear? All revaluations done to be reversed and profit or loss to be shared between all the partners, including new partner in new profit sharing ratio. First time when I did revaluation, there was profit that was shared between old partners. Then I will reverse everything. Now there is loss. that will be shared by all partners. In what ratio? New profit sharing ratio. Is this clear? Now, this you will do only if they mention this in the question. Otherwise, it's only revaluation. Now, reserves. What is reserves? We stored and kept the profit. We don't want some new partner to enter. Imagine your parents bought ice cream, okay, in the morning. You thought night when you're watching some movie, that time you will eat that ice cream. So you stored that ice cream in the fridge, thinking that you will eat it later. Afternoon, guest came. And in that guest, there was one small kid. In front of your eyes, you saw your mother ask that kid, do you want ice cream? And went to the fridge and removed that ice cream and gave it to that small kid. How will you feel? Bad, right? So when you get that call that guests are coming home, go to the fridge and eat that ice cream off. Are you getting this? That is reserves. You have stored it for your future and some new partner is coming. We don't want that person to enjoy. So distribute among old partners. Distribute among old partners. Reserves account debited to partners capital account in old profit sharing ratio. Clear? Now we will open the door. Now we will open the door and tell, come in. Whatever we had to do, we did. Come, get in. Clear? Now, new partner will bring money. Bank account debited to new partner's capital account. Whatever amount brought by new partner. It can be capital and goodwill or only capital. Whatever amount is brought by new partner. Okay, then goodwill distribution. Who has to give to whom? No. It is gaining partner to sacrificing partner. Don't come to automatic conclusion telling that new partner will give to old partner. We have seen questions in study material where one of the old partner is also gaining. Are you getting this? Nowhere you are going to tell me new partner, old partner, returning partner, old partner, partner who died, old partner, nothing. Goodwill distribution will always be gaining partner's capital account debited to sacrificing partner's capital account. Adjustment of goodwill. Clear? Always. Next, make capital proportionate. If it is mentioned in the question, they will tell make capital proportionate. Now you have to understand one thing. If it is, they will tell sometimes keeping C's capital as base. They will tell keep one partner's capital as base and make capital proportionate. That time what will you do? Keep that partner's capital as base. You will get to know what is the total required capital. Then whatever total required capital is, there go to partner's capital account and see how much is the existing capital. If at all they have more capital already, that is called as surplus. Take the money and give it to him and tell him to take it. If there is less capital in his capital account, that is called as deficit. Ask him to bring more money. This is the first type of question where they can ask you to make capital proportionate. Second type of question, they will not tell anything. They will just tell capital has to be proportionate. They didn't tell you whose capital to be kept as base. That time you will learn something that you learned in your unit number 2. Asset is equal to liability plus capital. Assets, you only did the revaluation. Liabilities, you only did the revaluation. Balancing figure will be capital. Take that capital and that is your required capital. Make it proportionate. Then again go and check partner's capital account and find out whether there is surplus or deficit. Either bring money or take money. Clear? Next, third one. New capital is given in the question. There are questions in retirement where they tell you that total capital after retirement should be 3 lakhs. Total capital should be 2 lakhs. Now what you will do, take that capital and make it proportionate. It should be distributed in new profit sharing ratio. Is it clear? 3 different kind of scenarios or different type of language can be used in the exam whenever they ask you to make capital proportionate. Clear? Now, retirement of a partner. What? No, only after we finish the concepts of partnership. What? What time is the breakfast? 10 right? You will get it if you go now. Oh, that you will get later also. Tiffin shops you will get it. I will give break at 10:30. Okay, I will finish like all the concepts I will finish, then I will give break. If you are going to PG, then fine. You are having here only, no around. Yes. Retirement of partner. Here afternoon time also there will be dosa. So obviously you will get it in the... that you should have told, no. You don't leave it on the hotel. You are hungry. Okay, then wait. Anyways, you have controlled so much, no? 15 minutes more you can control. Okay, now listen. Let's finish the concepts. Shh. Retirement of partner. Now, if you have done admission of a partner, many things will remain same. Many things will remain same. Clear? Existing partner leaving the partnership firm voluntarily. Voluntarily. Clear? Now, steps to be followed in case of retirement of partner. Focus, hello. Full focus. Steps to be followed in case of retirement of partner. NPSR again. Usually it will be given in the question. Or if they tell you A, B, C are partners with 3:2:1 ratio. Then they tell you A retired. And they don't tell you anything after this. Then natural assumption is that the new profit sharing ratio is 2:1. Is it clear? If they give new profit sharing ratio, you have to consider. If they don't give, you are just doing the rule of elimination. You eliminate the person, you eliminate the share, remaining share is going to remain the same. Clear? Compute sacrificing ratio or gaining ratio, old ratio minus new ratio, same concept. Prepare revaluation account, again same thing, but profit or loss will be shared between whom? All partners, including the retiring partner, because he was also there. Now it is not opening the door to let the person come in. Now it is opening the door to send the person out. Before sending, we have to give whatever is belonging to that person, we have to give it to him. Next, reserves. Can we tell him buy and then share the reserves only between us? No. Reserves also should be shared between all the partners. Now, goodwill computation will remain same what we did. Goodwill distribution also will be same. Now, it is retirement case. So, which partner will give to which partner?
Gaining partner.
Yes. Gaining partner will give to sacrificing partner. No retiring partner or no continuing partner. It is again gaining partner to sacrificing partner, because even in the continuing partner, there might be a person who is doing the opposite. Okay. Joint life policy or separate life policy. What is this joint life policy? What is this? A life insurance policy which is taken by the firm on the life of all the partners jointly. Separate life policy means life insurance policy taken by the firm on the life of an individual partner. Both the cases, the policy is taken by the firm. Because it is taken by the firm, premium is paid by the firm. Because premium is paid by the firm, the premium has gone from each partner's pocket. So any money comes in, it has to go into partner's pocket, all of them. Clear? Now, if partner dies, what will happen? Policy amount will be received, policy amount will be received. If partner retires, that time will not get policy amount, surrender value will be received. Surrender value will be received. Is this clear? Now, if surrender value is received, whatever amount is received, whatever amount it is there is received, it is shared between all the partners in old profit sharing ratio. It will be shared between all the partners in old profit sharing ratio. Now, accounting for GLP, there is one question in the study material which I am not going to do. Okay, on that premium, two questions basically, red, green and black, something and all is there. Okay, two questions are there in retirement where they are teaching you how to do the accounting for premium. Premium paid by the firm, either it is treated as expense or it is treated as asset. If it is treated as expense, every time you pay the premium, joint life policy premium account debited to bank account. Clear? If it is treated as asset, every time you pay the premium, Charan, listen, joint life policy account debited to bank account. Clear? Here you are treating it as asset, here you are treating it as expense. If it is expense, it should go to P&L. So P&L account debited to joint life policy premium. But asset, tell me one thing, you have a motor vehicle in the balance sheet. Can you show that motor vehicle at a value which is not even close to the market value? No. Whenever you show an asset, that's why in inventory chapter we tell that inventory should be shown at cost or NRV, whichever is less. That means whatever asset you're showing in the balance sheet, that is why trade receivable, what we do, we reduce the provision for doubtful debt and show. That means whatever is the real value, we are trying to portray that, because balance sheet actually tells us the position statement. So what are we going to do over here? Joint life policy is showing in the balance sheet as asset, right? If at all it is not matching with the surrender value, we should make it match with the surrender value. Therefore, at the end of each year, JLP account must match with the surrender value. If surrender value is 0, then you should make this also 0. Are you getting this? Now, whatever amount is received, you will pass the entry, bank account debited to JLP. Now, ICA again doesn't follow consistency. Sometimes they put this amount directly to revaluation account itself. Whatever amount is received, they are putting directly to revaluation account. Now, don't get panicked if you see that, because if you put it to revaluation account also, it is distributed to partners itself. So, if you write bank account debited to JLP also, it is distributed to partners in old profit sharing ratio. Is this clear? Now, making capital proportionate, same thing what we discussed, same logic will be there. Now, settlement of retiring partner. Retiring partner is going. Should we settle them? Yes. How are we going to settle them? Either paid immediately, that means retiring partner's capital account debited to bank, or transfer to loan account. retiring partner's capital account debited to retiring partner's loan account, and this loan will be shown in the balance sheet as liability. Is this clear? Yes. Next we move into death of a partner. Very, very simple topic, death of a partner. Okay, death of a partner leaving the firm due to death. Okay, that means it is not voluntarily. Now, amount payable to deceased partner. We can't pay him, so we will pay it to the legal heirs, who are also called as executors. Now, all accounting remains same. Preparing revaluation account, partner's capital account, everything same like what we are doing in retirement. Now, computation of amount payable to executors. Computation of amount payable to executors. Now, you can just get a question in retirement, in death, telling that compute the amount that is supposed to be paid to the executors. Now, what and all has to be paid to the executor? The capital account balance that is there, that has to be given to the executor. Current account balance that is there, that has to be given to the executor. But what if current account has debit balance? What if current account has debit balance? That means partner had to give us. So that will be subtracted. If it is credit balance, it will be added. Clear? Interest on capital. If there is some pending interest on capital, partner would have died somewhere middle of the year. So till that day we have to give interest on capital. That will be added. Interest remuneration to partner, if it is there, that also has to be added. Profit share till the date of death. This is not there in retirement. In death it is there. By retirement it is voluntary. You could have waited till the end of the year, then you could have retired taking your profit share. But death is involuntary. So he has died somewhere middle of the year. So we have to give profit share till the date of death. Now in the question, if they tell, there are some questions in death of a partner, they have agreed to give profit share till the end of the year. Then you follow that. Otherwise you give only till the date of death. That time what will be the entry? When you give distribution of profit to partners, what is the entry? Distribution of profit to partners, what should be the entry? P&L appropriation account debited to partner's capital account. But P&L appropriation is prepared at the end of the year. If a partner dies in the middle of the year, now we are not preparing P&L appropriation over here. That time we will pass the entry P&L suspense account debited to partner's capital or current account. Is this clear? Now if they tell partner died on some date, but they said pay interest till the, pay profit share till the end, and they tell accounting is done at the end of the year. That time you can't use P&L suspense, you will use P&L appropriation. You have to see whether the accounting is done on the date of death, then P&L suspense account debited. Whether the accounting is done at the end of the year, then P&L appropriation account debited. Is this clear? Now drawings. Drawings means what? Amount that he has to pay. That's why it is subtracted. Interest on drawings means what? Amount that he has to pay. Again it is subtracted. Goodwill share is what we have to give them. That is added. JLP or SLP share, not the whole amount. Only the share, that also will be added. Reserve share, that also will be added. Revaluation profit share. If it is profit, it will be added, and if it is loss, it will be subtracted. This is the amount that is payable to executor. Again, same thing. Amount payable to executor can be paid immediately, or it can be transferred to executor's loan account. Now, when you are transferring it to executor's loan account, executor gets this option. Executor gets this option. There is no question in study material based on this topic. It is there in the examples which they have given before the question starts. If they want, they can pick that example and put it in the exam. So here, there is a simple rule, okay? Executor can choose, pay me interest at the rate of 6% per annum. Or executor can tell, give me share in profit. But to give you share in profit, executor is not part of the profit sharing ratio. So we cannot distribute anything in profit sharing ratio. So do this profit earned into amount payable to executor divided by capital of remaining partner plus executor's balance. That means what we are telling, in the capital that is invested in the firm, even executor's balance is there because that is not paid to that person. So what we are going to do, total amount whatever is there, existing partner's cap balance plus executor's balance, take that as the denominator. In that, see what is the proportionate of executor's balance, multiply into profit, that much share he should get. Now that is not going to be decided by the firm. It is at the option of the executor. He will choose. He will calculate under both methods and he will find out which is beneficial, that he will take. Clear? Death of a partner. Okay, done. Dissolution of partnership firm. Last unit of partnership, dissolution of partnership firm. See, partnership is getting dissolved here. Even dog is in panic mode. Don't ask me what this lady is doing on top of the table in the corner there. That is just chat GPT stuff. Okay, we don't know why they have put that person there. One lady is scared over here. One dog is there over here. All the papers are that side, this side because they are dissolving and they want to cut the profit into half. Whatever amount is there, they want to cut it into half. I get the half. This fellow is like, you take half, but I will take the coffee machine. He is not bothered about profit and all. And this person, I don't know, they're telling mine, and this person is on top. I don't know what is happening. And one person's hand is there. Their finger is also not there properly. Ghost hand is there in the corner. That ghost only was responsible for the dissolution. Haunted room. Up left, there is one person. Again, zombie is there. These are the people. This person and this person responsible for the dissolution. Look at this. Ghost hand. Huh? Yes. Okay. Dissolution of partnership firm. What does it mean? Shutting the partnership firm. Dissolution of partnership firm is nothing but shutting the partnership firm. Here what we are going to do, accounting for dissolution. Accounting for dissolution. Step by step we'll discuss one thing. First, what we have to do, all the things we have to bring it into one place. Don't you think if I have to sell many assets and it is there scattered in different rooms, don't you think I'll bring everything into one room? So when the person comes to see, it will be there in one place. Correct? That is not the reality of this, but what we are doing is, if I have kept everything in different places, no, every time one asset gets sold, I have to pass asset sale entry, which we were doing in depreciation chapter. Every single asset, imagine I have 500 machineries. Every single machinery gets sold, I have to pass the sale entry for machinery. Clear? That is why first transfer all the assets and liabilities except cash and bank to realization account at book value. Why at book value? Because we have to remove from books and put it into one place. That means we are anyways dissolving the firm. We don't want to calculate profit or loss individually. In totality, we need to know the profit or loss. That's enough. Clear? So when you remove the asset, realization account debited to asset account, asset gone, so asset is credited. And liabilities account debited to realization account because liability gone, so liability is debited. Clear? So we are bringing all the assets and liabilities to one place. Asset taken over by partner. At what value? Agreed value. There is some AC over here. If I am the partner and the firm is getting dissolved, do you think I'll take it at book value? I will convince the others. Anyways, we are going to sell it. Give me a little lesser than whatever is there in the books. So when partner is taking the asset, partner's balance has to reduce or partner's balance has to increase. Partner's balance has to reduce because instead of giving money, we have given them asset. So partner's capital account debited to realization account. Is this clear? Yes. Good morning. Hello. Yes. Liabilities taken over by partner. If liability is taken over by partner, that means partner's balance has to increase or decrease. Already partner had to be paid money. One more liability also he put on his head. That means he has to be paid more money. So realization account debited to partner's capital account. Sale of asset. When you sell the asset, what will you get? Money. At what value? Not book value, sale value. Sale value, what is given in the question. So bank account debited to realization account. All the assets are sitting in realization. So money that comes also, you have to route it through realization. Liability settled at value, whatever is paid. What should be the entry? Realization account debited to bank account. Is this clear? Yes. Now, realization expenses paid. What is realization expense? When you're closing the partnership firm, you have to go to one CA, CS, CMA, lawyer, agent, all these people you have to meet. They will not come for free. So you have to pay them. That is your realization expenses. Realization account debited to bank account. Expense also don't route it through anything else, route it through realization account itself. Close the realization account. Just like revaluation account, when it is closed, profit goes to partners, loss also debited to partners in their old profit sharing ratio. I don't even have to write old profit sharing ratio. I can just write profit sharing ratio. There is no old new here, only one profit sharing ratio. Now settlement of partners. After everything is done, if money is there, what should we do? In the bank account, money is there. We should distribute to partners. In what ratio? No profit sharing ratio. This is money. No ratio. No ratio. Good morning. No ratio. You go and see the capital account. If partner has credit balance, then pay. Partner's capital account debited to bank. If partner has debit balance, then take from him bank account debited to partner's capital account. Sir, how can we take from partner? Because partner has unlimited liability. That is a feature of partnership, unlimited liability. Now, if partner does not have anything to give, other than the clothes that the partner is wearing, nothing is there that the partner can give you, then what will you do? Then insolvency of partner happens. Insolvency of partner happens. Now what will you do? If partner is unable to pay the debit balance is there in partner's capital account, that means partner has to give money. He is unable to pay in his capital or current account due to insolvency. His loss will be borne by other solvent partners in capital ratio, not profit sharing ratio. This is told by Garner versus Murray rule. Garner versus Murray rule. Is it clear? So now, if partner has debit balance and he is insolvent, just by seeing debit balance, don't come to conclusion that he is insolvent. If he has debit balance also, if he is solvent, he'll give money. If partner has debit balance and is insolvent, then it has to be borne by other solvent partners. In which ratio? Capital ratio. Is it clear? Now in questions related to insolvency, solvent partners should bring money for their share of realization loss. Whenever we see insolvency questions, right? If you have realization loss, your hand should move automatically. Other side, again, partners will bring money. Which partners will bring money? Solvent partners. This does not happen practically. It only happens in books. In practically, what we will tell? Okay, shortage is there. You have to give me money. We'll adjust to both of these. I say also in their study material, they have given one note in one box telling that this won't happen practically, but in books we are going to do it. Clear? Accounting wise, you are going to do it. So whenever you see realization loss, you will write no in partner's capital account to realization account. Automatically, other side you write by bank account. They have to bring money. Who will bring money? Only solvent partners. Only solvent partners can bring money. Clear? Non-applicability of Garner versus Murray. When is Garner versus Murray not applicable? If all partners are insolvent. If all partners are insolvent, who will lose the money? Creditor will lose the money. All partners ran away. Who will lose the money? Creditor will come and stand and see the closed shutter. That's it. Clear? If insolvent partner has credit balance in his capital account. Partner is insolvent, but he has credit balance. That means he doesn't have to pay anything to us. We have to pay to him. Doesn't matter whether he is insolvent or not. Clear? If solvent partner has debit balance in his capital account. Solvent partner has what? Debit balance in his capital account as loss to be borne in capital ratio. Okay. If they have debit balance, then even solvent partner will not be part of this game because loss is to be borne in what? Capital ratio. Tell me one thing. If there is A, B, C and D. Here there is 1 and 2. Here there is 0, 0. Here there is 1 and 2. That means these two partners have debit balance. In this only B is insolvent. But still A, we can't ask him to give anything because he has negative balance in his capital account. So how can you have a negative ratio? So only C and D will bear that. Is it clear? Now piecemeal distribution. We will not discuss it now. Okay. Because piecemeal distribution, we have to read the steps and apply it in the question. So we will do it when we go there. With that, we are actually done with the concepts of partnership. We have to take a break for breakfast. Come back at 11 o'clock. Yes, guys. Welcome back. Now we have to start solving all the questions of partnership. Okay, one by one. We have a few to be solved. Yes. First question. Okay, let's begin with first question of partnership out of the few problems that we have to solve. Okay, few. This is from intro unit SM practice question 1. Study material practice question 1. Okay, this is the question. Let's get ready. Okay, let's start. Shh. Yeah, look at the question. Weak, able and lazy. If you do all these problems in before the exam, right, all the things are covered in partnership. Okay, weak, able and lazy are in partnership sharing profits and losses in the ratio of 2:1:1. What is this 2:1:1? Whole profit sharing ratio. It is agreed that interest on capital will be allowed at 10% per annum and interest on drawings will be charged at 8% per annum. Okay. No interest will be charged or allowed on current account. So if there is a current account, there is no interest, but capital 10% interest, drawings 8% interest. Now, the following are the particulars of capital and drawings of the partners. See the partner, we have weak, able and lazy. Capital account balance, current account balance, drawings is also given. The draft accounts for 2022 showed a net profit of 60,000 before taking into account interest on capital and drawings, subject to the following rectification of errors. A, B, C. These are the rectification of errors which we are going to do, and after that rectification, then you are going to prepare profit and loss appropriation account, current account of partners weak, able and lazy for the year ended 31st December 2022. Clear? Now, can you see what is the rectification of errors? Life insurance premium of week amounting to 750 paid by the firm on 30th June has been charged to miscellaneous expense account. What will happen if life insurance premium is charged to miscellaneous expense account? Drawings has been transferred. So first you have to take it as drawings and then you have to remove it from expense. When you remove it from expense, what will happen? Profit will increase. Profit will increase. Now have a look at this. See the net profit. It is given 60,000 in the question. Life insurance premium, when you add back, can you see profit is increasing? And the drawings which are given in the question of week, to that you have to add the rectification and you'll get his new drawings that time. 15,750. Clear? Next. Repair of machinery amounting to 10,000 has been debited to plant account. Repair of machinery has been debited to plant account. That means what? Now you have to take it as repair. If you take it as repair, what will happen? The profit will decrease, less 10,000. But when you took it as plant, you by mistake charged depreciation. Now you are going to reverse that depreciation. So remove the 2,000, only 8,000 will decrease. 10,000 decrease, 2,000 increase. So only 8,000 will decrease the profit. Clear? Next, traveling expenses of 3,000 of able for a pleasure trip to UK paid by the firm on 30th June has been debited to traveling expenses. So what they have done, it was traveling expenses of the partner, right? It should have been personal expense. It should have been taken as drawings. They have charged it to traveling expenses account. So now you have to remove from traveling expenses. When you remove from expenses, again your profit will increase. And you have to take it as drawings. So you have to add it to drawings and the drawings has increased of able. Lazy, there is no rectification. And this is the new profit. What is there? This is the rectified profit. Clear? 55,750 is the rectified profit. So if you see P&L appropriation, can you see 55,750 over here? Adjusted profit. Now what you have to give? Interest on capital. Capital is already given in the question itself, 75,000, 40,000 and 30,000. On that, directly calculate interest at what rate? 10%. Calculate 10% of that. Can you see interest on capital? You're getting 7,500, 4,000 and 3,000. This goes to partners. Then you have to even charge interest on drawings. But you can't take the drawings which are given in the question and calculate interest. You have to take the drawings which are rectified. Can you see the rectified drawing 15,750? Now, why are they telling drawings for 6 months over here? When date is not mentioned to you, you always take 6 by 12. So 15,750 into 8% into 6 by 12. And you're going to follow the same procedure for even the 13,000 and 10,000. Is it clear? Drawings should be debited to P&L appropriation or credited. Drawings is interest on drawings is an income to the firm. So interest will be credited. Can you see that interest credited to P&L appropriation? Then apart from that, do we have any salary mentioned in the question? No. You'll just distribute the profit. Profit will be shared in what ratio? The 2:1:1 which they have mentioned in the question. Clear? So what is the main importance of seeing this question before you go to the exam? That profit, if at all involves rectification, rectify the profits. After you rectify the profits, then only go for distribution. And the rectified drawings are used for calculating interest on drawings. Clear? That is your first question of partnership that you have to see. Next. And guess what? Even if it's intro unit, right, it can be asked in the exam because it has so much twists and turns over there. Now, second is intro SM practice question 2. SM practice question 2. Okay. Now, this is one more question which is important. Now, listen. Ram and Rahim are in partnership sharing profits and losses in the ratio of 3:2. What is this? Whole profit sharing ratio. Yeah, man, what's the doubt? Drawing amount. It will be reduced from partner's capital, but in this question it is fixed capital method. So it will be reduced from partner's current. See, current account they are prepared, and can you see drawings here? And even the interest on drawings also came here only. Interest on capital also is credited here itself. Profit share also will be over here itself because they told partner's current account. Next. Question number 2. This is also an important question. Ram and Rahim are in partnership sharing profits and losses in the ratio of 3:2. As Ram, on account of his advancing years, that means Ram is growing old, he cannot work as hard as before. The chief clerk of the firm, Ratan, is admitted as a partner with effect from 1st January 2022. Who is admitted? Ratan. Clear? So now you will have Ram, Rahim and Ratan. Ram, Rahim and Ratan. Clear? And becomes entitled to what? 1/10 of the net profits. Whatever profit was there, 1/10 will be given to Ratan. Clear? And nothing else. The mutual ratio between Ram and Rahim becomes unaltered. That means between Ram and Rahim, still the profit share is between them in the ratio of 3:2. Oh. Now it's working, no? Yes. Between Ram and Rahim, it's still in the ratio of 3:2. Now, mutual ratio between Ram and Rahim remains unaltered. Before becoming partner, okay, prequel, Ram was getting a salary of 500 per month together with a commission of 4% on the net profits after deducting his salary and commission. Now, you know this formula, no? If at all there is commission, commission on net profit before charging commission, commission on net profit after charging commission. Now, it is provided in the partnership deed that share of Ratan's profit as a partner in excess of the amount to which he would have been entitled if he had continued as chief clerk should be taken from Ram's share. That means what? Before he was clerk, when he was getting clerk, when he was a clerk, he was getting something. Now, if at all you are giving him something extra, that extra will go from whose share? Ram's share. It will be taken from Ram's share. The net profit for the year ended 31st December 2022 is 1,10,000. Show the distribution of net profit among the partners. Clear? Now, understand this. Do you agree Ratan was getting salary of 6,000 given in the question? Now, out of 1,10,000 profit, if you give 6,000, you are left with only 1,04,000. Correct? That 1,04,000, on that you have to calculate commission. Commission is 4 divided by 104. Why? Because they said after charging commission. Commission on net profit after charging commission. If they would have told before charging, you would have taken 4 by 100 itself. Clear? So when you do that, you get a commission of 4,000. So total amount that you are paying to Ratan was how much? 10,000. Now, when he becomes partner, tell me one thing. When he becomes partner, will you still give him salary and commission? No. Because salary and commission was given to him when he was a clerk. Now he is a partner. So you will not give salary and commission. So what will be the profit that will be remaining? 1,10,000. Full 1,10,000 will be there. And his share is what? 1 by 10. That means he will get 11,000 now. He'll get 11,000. That means extra 1,000 that he is going to get, that will be paid by Ram. That will be paid by Ram. Is it clear? Now can you see the profit and loss appropriation? 1,10,000 is there. If you take 1,10,000, okay, earlier, now understand this, you have to understand Ram and Rahim. When Ratan was not there, Ram and Rahim were getting how much profit? 1,10,000 or 1 lakh? They were not getting 1,10,000 because when Ratan was clerk, we had to pay salary to Ratan. After that, we had to pay commission to Ratan. That means only 1 lakh would remain for Ram and Rahim. And in the share ratio of 3:2, Ram was getting 60,000, Rahim was getting 40,000. Now Ratan will get extra 1,000. That extra 1,000 do not trouble Rahim. Rahim told, I am not going to bear it. So now it is subtracted from Ram share, and can you see Ram share became 59,000 and Rahim is still 40,000 and Ratan is getting 11,000. Is this clear? Did you understand the distribution of profit? So Ram is going to take Ram is going to give whatever it takes to bring Ratan inside. So Ratan was getting 10,000 salary and commission when he was a normal employee. By becoming partner, now his profit share has come to 11,000. That extra 1,000 we'll take from Ram share and give it to Ratan. Is it clear? Yes, that's it with that particular question. Now we go into goodwill. Goodwill SM illustration 1. SM illustration, sorry, not 1, 11. Small question, simple question. Okay. This will test everything in goodwill. Now, understand. Go to the end of the question. You are required to calculate goodwill. AG is supposed to bring and journal entry for the same. Hello. Here, focus. Exam is in September, guys. 29 days to go. That's it. Okay, only 29 days. Are you feeling tired? There should not be the word tired only. You don't know what is tired. See Charan. He's so excited and happy. And yeah. Now he's the graph in the stock market at the beginning of the day. Ending of the day it will peak. And the market will crash. Yes, guys. Okay. Now, intro done. Intro, those two questions are very important. Okay. Because other than that, intro is like basics. Just telling you how to calculate interest on drawings, how to calculate interest on capital, all that. Now, partnership, goodwill, SM illustration 11. CU and AU are in partnership sharing profits and losses in the ratio 5:3. What is this? Old profit sharing ratio. What is CU and AU? Yes. That's why you're a science student. See, all of these guys didn't even understand what is CU and AU. Some of them for CU, they were thinking CU, telling bye-bye to someone. Okay. Only you are the person who identified copper and gold. Now, on 1st April 2022, they decided to admit AG. What is AG? What is AG? Silver. Now, see, commerce students are competing little. Oh, you are also science student. No wonder. Only you both. Okay. See, commerce students answer. AG is Argentina. Huh?
Latin name of silver. That is
What?
Latin name of silver.
What?
Previously they used to call it silver. It's full form of age.
What is it?
Full form of age.
Yeah, what did you tell?
Argentina.
Oh, I heard it as Argentina. I was thinking of Messi here when you're talking about Argentina. Pure commerce student. No crossbreeding. Pure. Okay, now AG will bring. Okay, guys. Shh. AG will bring 2 lakh as capital for 1/4 share. AG will bring 2 lakh capital for what? 1/4 share. That means, do you know that 3/4 will be shared by others? Now, can you see over here new profit sharing ratio is 2:1:1 between CU, AU and AG. Everything is given. Now, CU was entitled to salary of 2,000 per month. It was revised to 3,000 per month from 1st October. Clear? Now, interest on capital was paid at 8% per annum. Forever it is 8% only. No problem. Capital on 31st March 2022, CU was 4 lakh, AU was 3 lakh, which had remained unchanged since last 4 years. Why are they telling you that it did not change from last 4 years? Because it is fixed capital and it will also help you to calculate the interest on capital. Goodwill was to be valued at 3 years purchase of average adjusted weighted average profit. Of past 4 years. The profit for the previous 4 years before charging interest on capital and salary to CU was as follows. Now you're like, sir, you told no, sir. Weighted average profit we will follow only if there is a trend. What is this, sir? 2 lakh 10, 60, then it became 2 lakh 10 and 3 lakh 5. There is no increasing trend also, decreasing trend also. That is why they never told on that profit. They said on the average adjusted profit. Moment you heard the word adjusted, no, you should have been a little alert, because when they tell the word adjusted, that means there is some problem. Correct? Now see here. These profits were subject to following rectification. Without 10 marks, they're gone. It's okay, no issues. Many other marks are also going if you don't study rectification. Okay. So following were subject to rectification. After rectification, then you do everything. So now, what are the profits that are given? 210, 260, 210, 35. Correct? Now go and make a table. 2 lakh 10, 260, 210, 3 lakh 5. That is your starting point. Now only two things which are really straightforward in this question is salary and interest on capital. Interest on capital, you already know their capital is 4 lakh and 3 lakh. That means their capital is 7 lakhs and interest rate is 8%. 7 lakhs into 8% makes it 56,000. Is it 56,000? Yes. So you'll subtract 56, 56, 56, 56. Sir, how do you know that every year interest is same? Because they said capital is same from 4 years. Clear? Now, salary they said 2,000 per month. Can I directly take 2,000 per month for every single year? No. Up to what date it was 2,000? Up from 1st October it changed. From 1st October the salary changed. That means up to 1st October it was same. So here, can you say 2,000 into 12 is 24,000? Here also 24,000. But here it is not same, because here it is going to be 2,000 into 6 and 3,000 into 6. Why? Because they changed on 1st October 2021. Okay, 1st October 2021. This makes it 12,000 and this makes it 18,000. Can you see the total salary is 30,000? Is it clear? But next year, full year, the salary is 3,000 only. That is 36,000. Are you getting this? Very important date. They changed the salary on 1st October 2020. 1st October 2020 will fall exactly in the middle of this year, 2021. So 6 months 2,000, 6 months 3,000. Now we'll go into the rectifications. Machine costing 40,000 purchased on 1st October 2020 was wrongly charged to revenue. Wrongly charged to revenue means what? Wrongly they have taken it as expense. Wrongly they have taken it as expense. When you remove it from expense, your profit will increase. So can you see 40,000 added to profit in the respective year? See the exact year it is. It is in 1st October 2020. That means it will fall into 2021. Wrongly they charged to revenue. That means they missed the asset. If they missed the asset, they will forget one more thing. What is that? Depreciation. They have missed the depreciation as well. Now they said machinery was depreciated at 20% per annum on written down value method. That means, do you agree first year depreciation should be 40,000 into 20% into 6 by 12. That means depreciation should be 4,000. 4,000 should be minus because profit will reduce. So next year the depreciation will be on 40,000 or something else. 36,000 written down value method. They are following written down value. This becomes 36. So here it is 36,000 into 20%, 7,200. Can you see how it is impacting the profit of 1 year and the other year also? Next. Then stock on 31st March 2020 was overvalued by 20,000. If stock is overvalued, what should we do? We should reduce it. If you reduce the stock, what will happen to profit? Profit will reduce. But 1 year's closing stock is next year's opening stock. 1 year closing stock was more. So you reduce it. So what happened? Profit also reduced. That means this stock went to next year and next year's opening stock is more. If opening stock is more and you reduce the opening stock, what will happen to profit? Profit will increase. I hope you know this. Okay, closing stock increases, profit increases. Closing stock decreases, profit decreases. Opening stock increases, profit decreases. Opening stock decreases, profit increases. So can you see 20,000 was overvalued. So we have to correct it now. So can you see 20,000 minus in 1920 and 20,000 plus in 2021? Because this is, we are reducing the reduced closing stock, profit decreased, and here reduce the opening stock, that time profit increase. Is it clear? So 1 year's closing stock, if there is a mistake, that will automatically affect the opening stock of next year. Clear? Next. there was a loss by fire amounting to 10,000 in the year 1819, which was not considered in trading account but was correctly debited in P&L. Correctly they have done, right? Then why are we bothered? It is an abnormal item. Anything that has happened in the past which will not happen in the future, ignore it for goodwill calculation. So what you are doing, removing the loss. When you remove the loss, what will happen to profit? Profit increases. So added. Clear? Last one. Debtors as on 31st March 2022 included bad debts of 5,800. If there is bad debt of 5,800 included in debtor, that means we should remove it from debtor. We should remove it from debtor. If you remove from debtor, what will happen to the profit? Profit will again decrease. So 5,800 you are going to decrease. Is this clear? That time you will get the profit. Can you see the adjusted profit which you are getting after that? It is in a trend. Increase, increase, increase. And they told weighted average profit. Highest weightage has to be given to the most recent year. Therefore, 1, 2, 3, 4, you will get the product, you will get the weighted average profit. Then you will be able to calculate the goodwill. Now, when you are calculating, when you do this, you got goodwill as 5,40,000. That is not AG's share. That is not AG's share. AG's share is 1/4. So 1,35,000 is AG's share. So he has to bring that 1,35,000 and he has to give it to the others. Others in what ratio? If you see the others before this, they were in what ratio? 5:3 ratio. 5:3. The new, that is old. New profit sharing ratio 2:1:1. You have to calculate and see what is the sacrificing ratio. When you do the sacrificing ratio, okay, you are getting 1/8 and 1/8 for these two people. That is why this is 1:1 as the sacrificing ratio. That is why, can you see, it is shared equally. Old ratio was 5/8 and 3/8, and new ratio is 2:1:1. Use the formula old ratio minus new ratio. The two partners will get negative answers. That means two partners will get positive answers because they are sacrificing. One partner will get negative answer because that person is gaining. Who is that person who is gaining? That is AG. AG will give it to AU and CU. Is this clear? Now, what is the main crux of this question? You cannot do goodwill calculation unless and until you rectify the profits of all the past years. You cannot do goodwill calculation if there is something that has happened in the past which is not expected to happen in the future. Only when you sort all this, then only you can do the goodwill calculation. Clear? Because this question has so many twists, this question also, even though it is from goodwill unit, can be asked in the exam. Or any of the small adjustment of this question can be added to an admission or retirement question. Clear? Yes. Next question which we have to go into. Again, goodwill, practical question number 1. Practical question number 1. What? Yeah. Wise, clever, dull. Wise, clever and dull. We're trading in partnership sharing profits and loss in the ratio 4:3:3. That means what is this? Old profit sharing ratio. The account of the firm was made up to 31st December every year. The partnership provided inter alia the following things. They said that on the death of a partner, goodwill was to be valued at 3 years purchase of average profits of the 3 years up to the date of death after deducting interest at 8% per on capital employed and a fair remuneration for each partner. What are they telling? The key word in this question is up to the date of death. Up to the date of death. Profit is not calculated last 3 years. Profit is calculated up to the date of death. You have to calculate the average profit. Is that clear? So now, but whatever profit you are calculating, that should be after removing the interest on capital and after removing the salary, after removing the fair remuneration. Okay, profit to be assumed evenly, earning evenly, because wherever you want to do 6/12, 2/12, 3/12, you can do it. Now on 30th June, they are following calendar year or are they following financial year? How do we know that? 31st December every year. They are following calendar year. If they are following calendar year, if 30th June is the date, that means exactly middle of the year that person has died. Correct? Wise died and it was agreed that on his death to adjust goodwill in the capital account without showing any amount of goodwill in the balance sheet. Even if they don't mention that sentence, are you going to put goodwill into the balance sheet? No. It is going to be adjusted in capital account only. It was agreed for the purpose of valuation of goodwill, fair remuneration for work done by each partner. Each partner would be 15,000 per annum. That means 15,000 into 3, you have to take a total remuneration of 45,000. That the capital employed would be 1,56,000. How much is the capital employed? 1,56,000. Clever and dull were to continue the partnership sharing profits and losses equally after the death of vice. Old ratio we know, 4:3:3. New ratio you know, 1:1. That means with that you should be able to find the sacrifice or gain ratio. Clear? Now the following were the amounts of profits earlier years. Look at the goodwill and tell me how many years average? How many years average over here? How many years average? 3 years average. How many years purchase? 3 years purchase. How many years average? 3 years average. How many years purchase? 3 years purchase. How many years profit is given? 4 years profit. Why? Because we have to calculate profit of the last 3 years up to the date of death. When did this person die? 30th June 2022. That means we need 3 years profit, means 1st July 2019 to 30th June 2022. We need for this 3 years. Are you getting my point? So in 2019, do you need the full year's profit? No, we need only half year's profit. 2020, do you need full year's profit? Yes, you need full year's profit. 2021, do you need full year's profit? Yes, we need full year's profit. 2022, do you need full year's profit? No, we need only half year's profit. If you take your calculator, 67,200 divided by 2 plus 75,600 plus 72,000 and plus 31,200, you should get 2,12,400 as the average profit. That should be your average profit. Sorry, is that the average profit? No, that is the total profit. Total profit divided by 3, that time you will get 70,800 as your average profit. 70,800. But good morning, this 70,800 is before interest, before remuneration. So how much is the remuneration over here? 15,000 per month. So you are going to minus 45,000 of remuneration. How much is the interest on capital? How much was their capital? 1,56,000 they said is the capital, and 8% you are going to take. Clear? 8% interest on 1,56,000. So can I take 8% of 1,56,000? 12,480. 12,480. So how much is it now? 70,800 minus 45,000 minus 12,480. Is it 13,320? Is this the goodwill? No. This is just average profit. And average profit, how many years purchase? 3. So that makes it 39,960. Is this the goodwill? Yes. Is this the goodwill what we will give to the deceased partner? No. We'll give only his share. What is his share? Wise share of profit is 4 by 10. So into 4 by 10, that gives us 15,984. Did you understand? This should be the goodwill share for Wise. Now let's look at it. 15,984. How much who is going to give, that you have to calculate. That will be in sacrificing ratio or gain ratio. Clear? That you have to calculate. Now obviously, can you see they have done the difference? Can you see clever and dull? They are sitting in 2 by 10, 2 by 10. That means there's hey, sit back. Sit back, sit back. First of all, you are sleeping here. No, what will you do getting up and going? You sleep here only. Huh? Sit here, sit here. I am not letting you go. First thing before studying, you should learn discipline. Okay, without discipline, you will not clear this course. I'll write on dotted line and give you. Without discipline, you will not clear this course. Forget foundation. You will not be able to become chartered accountant without discipline. Because what it ultimately takes, everybody will have hard work. Okay. Only people who are willing to do it consistently, only they will be able to pass. Okay. So sit. Let's enjoy the drama. Okay. Next. Admission. Goodwill done. Did you understand this? I am not showing you how to calculate sacrificing ratio and all, because I hope you know how to minus fractions. When you are minusing fractions, you have to take LCM. I hope you know LCM also. Next, admission. Actually, even in regular class, you should not get up and go. People do. Because I'll tell you the difference. Some of you have attended regular class, right? Okay. You have seen, right? I mean, you have attended previous marathons. You have done the same. Okay, because I was doing something else. I have seen you getting up and coming out of marathon, going and drinking water, coming back. You've done it, correct? And people who have attended regular class, the back benches. Okay. You have seen in regular class of the people getting up and going to washroom, all this. You have done this. Now, see the difference, okay? Inter also people do this. Inter also you'll see some from down, they will be coming up, filling their water bottle and going. Class will still be going on. But in finals, okay, how I realized is, one day I had given break for final students. After taking 20-25 days of class, I had given break. I mean, break means not like that. Every day I'm giving break. Some 25th day of class, I gave break at around 8:15 in the morning and I was just sitting there in the sofa. That time I saw, okay, here one foundation class is going on, there one inter class is going on, that side there was final class going on. From foundation class, one boy came out, filled water bottle. From inter class, one girl came out, she went to washroom. Then inter class, one more boy came to fill the water bottle. So that time it flashed for me that this is not happening in final class. It's not happening. If I have to give break at 8:15 and if I don't give break till 8:30, nobody asks break. And till I give break, nobody is getting up and going. Are you seeing the difference? So they have learnt it that this is what it requires. If you want to clear, this is what it requires. They are not getting up and going. Are they not feeling tired? They are also feeling tired because they are working more hard than you guys. Okay, their class duration might be 3 hours, but they are working more hard because after class they go to articleship, and articleship is madness, bonded labor. Okay, then from there again they are going home. Sometimes they miss the last half an hour of class because they leave early for articleship. They go back and watch the recordings of that last half an hour because otherwise next day they will not be able to cope up. So they watch that, then they come to class. So it is like if they can do it, you can also do it. Correct? Dedication, guys. Dedication is required. I'm telling you, it is not possible. I'm not going to give you sugarcoating words. If you want to clear, you have to put in the hard work. That's it. You have 29 days left. You have to become a sage in the 29 days. You know nothing. Okay, you are in ICU batch. You are sitting in ICU batch. You are sitting in that class talking. Okay, I know. Because I can hear you guys when I'm taking regular class in the other class. Now don't tell me no. I have seen it. Okay. So whenever I pass, I just have a look. What are you guys doing? Okay. You will be there. You will be distracted. Admit the fact. So you know what mode you have to go into? On the last day of the exam, when the exam gets over, you will not feel happy if you have worked hard. You will think no, last day you'll be in jolly mode. You will not be in jolly mode. Last day you will feel like something empty feeling. Next day morning you will realize, exam got over. If you have really studied properly, when you come out of the exam hall and when you go home, you would have thought, no, so many things I'll do after exams. You will not be able to do any of that. You will be feeling like fully blank or empty. You will just go and sleep that day. If this happens, that means you have worked hard. Next day morning, get up and do whatever you want. Okay, if you have not taken it seriously, right? On the exam day, you will not feel that emptiness. It will happen. I'm telling you, it will happen. When you finish the exam, right? You will not go and you will think, I'll go and watch this movie, or I'll go and nothing. You will go and start watching the movie. You will just sleep off because that is the drained situation you will be in. So don't think that it is easy. It is not, and it's not meant to be also. Are you getting my point? So please focus. 29 days if you focus properly, it's still enough to clear CA foundation. Now you are feeling that I wasted so much time till now. It's okay. You can't change that. But from now on, if you are going to be serious, right? From now on, 100% you will be in the next felicitation. There is a felicitation, no, they conduct every time. Okay, 100% you will be there in the next felicitation. So your goal should be to be in that. Are you getting this? Is it tiring? I know, I was also a CA student, right? It is draining. It's not tiring, it's draining. But every time you think of the end goal, that time it will be worth it. Now, all this motivation is bakwas, by the way. It's bakwas, I don't believe in it. I have to do it because to motivate you guys, but I know it's total bakwas because people who are watching on YouTube later on know the same motivation. They'll also get motivated for 2 seconds. Then, when they pause this marathon video to take a break, they'll be scrolling shorts. Oh ho ho, new trend. Somebody is dancing. Okay, then they'll be watching reels. Are you getting my point? So, the real motivation that you have to find is self-motivation. Find a reason why you are doing CA first of all. When you get that reason right, you will, every time you'll remember that reason. Okay, last time in marathon, somebody asked, sir, give some motivation, sir. I told, do one thing. Last attempt marks card is there, no. Okay, put that as your, on your phone. Background, no, you put that only, last attempt's marks card. And in that you can see, no, that unsuccessful written on that. Okay, put that. Highlight that and put that. That only is motivation. What more I should tell you? Correct? Your goal should be make that word short. It is written unsuccessful, right? Your goal should be to make that word short. Remove the first 2 letters. And it should become successful. What did you do? Yeah. Remove the first 2 letters and you should make it successful. That should be the goal. Is this clear? Yes. Let's start now. After all this gyan, now there is one person standing at the door. Admission. Clear? We have to go into SM practice question 2. For admission, SM practice question 2. Yeah, practice question number 2. Can you see Gopal, Govind? Yes. Gopal and Govind are partners sharing profits and losses in the ratio of 60-40. 60-40 means what? 3:2. The firm's balance sheet as on 31st March 2022 was as follows. How much? Gopal, Govind already have capital. There is no reserve, nothing in the balance sheet. Now, due to financial difficulties, they have decided to admit Guru as partner in the firm on 1/4/2022. On the following terms, Guru will be paid 40% of profit. Can I bring this into fractions? 40% is in percentage. Can I bring it into fraction? That will make it 2/5. Clear? Guru brings in cash 1 lakh as capital. Only that much they have told. Capital. It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal average profit of the firm. Normal average profit means what? Simple average profit. How many years purchase? 2 years purchase. How many years average I have to take? 3 years average. Clear? Now, Guru will bring his share of goodwill. Guru is like, I'll bring my share of goodwill. First you calculate and tell me how much is my share. 1 lakh capital I'll bring. You tell me my share of goodwill, I'll bring it. It is also decided that partners will not withdraw their share of goodwill, nor will the goodwill appear in the books of accounts. Okay, they are not going to take the money and it will not be shown as asset. Anyways, we don't show it as asset, right? Next, for the profits for the previous 3 years were as follows. There is one profit over here, 20,000. Includes insurance claim received 40,000. Is it abnormal item? Is it abnormal item? Insurance claim received. So what will you do? You will remove the abnormal item. That time this will become loss. This will become loss because profit would have been added. When you remove the profit, 20,000 minus 40,000 becomes minus 20,000. Clear? Now, here there is a loss of 80,000, but this includes voluntary retirement compensation paid. That means there is an expense. When you remove that expense, this loss will come into profit of 30,000. It will come into profit of 30,000. Is this clear? Now, here there is profit of 1,05,000 and it includes a profit of 25,000 on the sale of assets. So when you remove the 25,000, this will come into profit of 80,000. Can you see? This is what you're supposed to do and this is your revised profit to calculate goodwill. Now goodwill calculation, can you see? 20 negative, 30 positive and 80,000. This you have to do. That is what we wrote in that goodwill note. We wrote that whatever has happened in the past, if it is not expected to happen in the future, you have to eliminate it when you're calculating profits for goodwill computation. Okay, now divide by 3 because they said simple average profit, normal average profit. You got the average profit. Multiply into 2 because they said 2 years purchase and this is your goodwill, but this is your goodwill of the firm. What is that new partner's name who is coming? Guru. What is his share? 2 by 5. 60,000 into 2 by 5. You will get 24,000. Okay, they have taken 40% directly, 24,000. Is this clear? So what amount he has to bring? He has to bring that 1 lakh which he told he will bring, and he will have to bring the 24,000 also. So 1 lakh plus 24,000, he is going to bring a total of 1,24,000. Clear? But whatever the 24,000 comes, it will be distributed between the other partners in what ratio? The sacrificing ratio. Now you have to go and check. It was decided to revalue the assets as follows. Okay, we will revalue the assets, no problem. New profit sharing ratio is what? 35 is to 25 is to 40. So can we simplify it and write 7 is to 5 is to 8? Can we write 7 is to 5 is to 8? 7 5s are 35. Or 5 7s are 35. 5 5s are 25. 5 8s are 40. Clear? New partner suddenly has become 8 by 20. 8 by 20 is nothing but what I told you, 2 by 5. Clear? Now you know the new ratio, you know the old ratio, you should know how to calculate sacrificing ratio. You should know who is going to give to whom. That I am not going to discuss. Okay? Now, revaluation has to be done. Fixed asset 4 lakh. How much is fixed asset over here? 3 lakh. Increase or decrease? Increase. So when you are preparing revaluation account, okay, see, fixed asset account debited to revaluation account. They have asked journal entries. Fixed asset debited, revaluation increase. Now what has happened over here? Investment nil. That means what? No revaluation upwards or downwards. Our investment is showing 50,000. Investment nil, they said. That means nothing. No revaluation. No, investment became 0. Don't get confused. Here, fixed asset became 44 lakh. Fixed asset didn't increase or decrease by 4 lakh. Fixed asset became 4 lakh. That's why you took it from 3 lakh to 4 lakh. Here, investment became nil. That means you have to bring from 50,000 to 0. That means there is a loss here. And you are going to write revaluation account debited to investment account. Clear? And the next thing, current asset is becoming 180. How much is current asset over here? 2 lakh. 2 lakh, if it is becoming 180, there is a 20,000 loss. So, revaluation account debited to current asset. And loan is becoming 1 lakh. How much is loan right now? It is already 1 lakh. That means there is no revaluation. Clear? Okay. So, revaluation profit or loss, you know, it will be shared between partners. Can you see revaluation account debited to Guru and Govind? Sir, what about 1 second. Who was the partner? Gopal Govind. This is not Guru, right then? How can it be Guru? It is Gopal's capital account. Okay, that is the typo. It's Gopal's capital account. Can you see the new revaluation profit credited to the capital account of the old partner in old profit sharing ratio, but we wrote Guru here. Are you getting my point? Okay, so this is typo by ICAI. Obviously, they are not going to make it in the exam. Gopal and Govind. Now, sometimes ICAI makes some errors which you don't expect grace marks for. Don't expect grace marks. They will tell sometime X and Y started partners. They started partnership firm and they are partners, X and Y. Then somewhere down the line, they will write by mistake, the profit sharing ratio between A and B is 2:1. There is no A and B in your story. It's X and Y. Correct? These kind of questions have come in the exam. And in suggested answer, they will just put 1 star and they will tell in the question paper, okay, it was printed as A and B. No grace marks. They're like your CA foundation students. You are expected to know if this started with X and Y and here by mistake I put A and B, then you only understand that it is X and Y. Is it clear? Okay, these are the errors which ICAI will not give you grace marks. 95% of the errors ICAI will not give you grace marks because it is still solvable. It is still solvable. Imagine the profit was supposed to be 10 lakhs. By mistake ICAI missed 1 0. Is it still solvable? Yes. That is what they expect. Okay. Now, after this goodwill, now see, look at all the journal entries. First one, bank account debited to Guru's capital account. Did I discuss that it is 1,24,000 now? But that 24,000 shouldn't sit in Guru's pocket. That 24,000 will be distributed to Gopal and Govind. In what ratio this is? 5:3. The sacrificing ratio they have found out. It is 5:3. Okay, have they shown the calculation for that? Maybe much lower. Okay, they haven't. Here it is. Can you see they have used percentage only? Don't get confused. Use fractions. They have used percentage and calculated. Don't do all that circus. Use fractions and the sacrificing ratio is 5:3. Is this clear with this journal entry? Now, revaluation we already discussed. Now, revaluation account, you know how to prepare. Partners capital account. Partners capital account also see, just to irritate you. Gopal's capital account, Govind's capital account, Guru's capital account. You know that, they know that you will prepare like this. Are you getting this? So now, in Gopal, Govind and Guru's capital account, what journal entries we discussed, that only will be there. That is revaluation profit, goodwill distribution, new partner brings money. That's all. Clear? Now, balance sheet when you prepare, can you see, you can see all the new values. You made the fixed asset 4 lakh. You made the current asset 1 lakh 80. But after that, somebody brought money. That will get added. So the current asset became 3 lakh 4,000. And loan and advance, you left it there only. Sir, investment is missing. Because investment became 0. Capital, from where will you get all these numbers? When you prepare the capital account, each partners, can you see balance carried down? 1 lakh. Balance carried down 1 lakh 1,000. Balance carried down 1 lakh 53,000. That is what will go to the balance sheet. Okay. Long-term loan and current liability, they are silently sitting and watching the fun. They were not changed at all. So the balance will remain same. Are you getting this? So basically an admission or retirement or death question is damn simple. Okay. Revaluation, goodwill, if you do this properly, then everything else is simple. Okay. Any doubt with this? Now, next. After that, in admission, there is one more SM practice question number 2. Oh, that is done now. What are we talking? Admission December 2021 exams. Admission December 2021 exams. For some reason only we have picked it. We'll see what that reason is. Here we go. What is the name of the partners here? A and yeah, A and B are partners, right? Find A and B in your life. Yeah, here they are. B. What, Mancharan? What happened? Okay, guys. Shh. Let's continue. Now, Charan, good morning. Okay, 26th question. Prepare revaluation account and partners capital account. That's it. Okay, the reason why we're picking this question is because of this point over here. Capital account of partners to be readjusted on the basis of the profit sharing arrangement and any excess or deficiency to be transferred to their current account. Usually if there is any surplus or deficiency, what do? We either give money to them or we take money from them. Is it very urgent? Okay, then sit. If it's urgent also no problem. Huh? What? Hot water. I am talking here for 10 minutes. I am only not going in the middle for hot water. Imagine I tell in the middle of class, wait, I will go gargle my throat and come back. See, if it is washroom, you can control it. Okay. And the more you control, the later satisfaction will be higher. Are you getting my point? You will feel more happy later. Correct, no? If, now Charan, imagine, you are going in bus. Okay, you are going to AP. You are from AP, right? You are going to AP in bus. 2 hours journey is there. Now I'm telling last 2 hours remaining. Full 6 hours means you'd have died. Okay? Or others would have died. Now, 2 hours journey is there. Last 2 hours. And when the last 2 hours started only, you badly want to go to washroom. Urgent it is. You're controlling like anything. Okay? Last 2 hours somehow you controlled because you know they're not going to stop the bus. Then when you got down from the bus, you control for 2 hours, right? Now you are walking towards your house. You're walking. Run. Okay. Run means it is more risk. Okay, he's walking. Okay, auto. He has taken one auto and is going towards his house. Now listen, this is his house. As the auto goes closer and closer, don't you think the pressure is higher and higher? Are you getting this? Once he gets down from the auto, he can see the house gate there. When he's going towards the house gate, the pressure is even more high. When he opens the house gate, now he knows the house. There only, he knows the washroom location also. When he's going more closer to washroom, the pressure is more high. Are you getting this? But after that, you feel happy? He'll book Rapid, that will cancel 2 times. Then first of all, you should have asked me, when you get down from the bus, in the bus stop only there's a washroom, right? Why you are going home? That you should have asked. Huh? Yes. For more satisfaction, it seems. So, Charan, moral of the story is focus. Yes. Let's continue, guys. What? No. They are not talking at all. They'll start spamming in comments. Age 2, right? You have all, obviously, if by the age of 18, 19, if you have not experienced this, then you have not seen anything in life. Okay, this is a normal thing. Like, have you ever thought when you are closing the fridge, when that light will turn off? Have you closed slowly to see when that light is turning off? Yes, you should do that. Otherwise, life was boring, right? What?
Charan's goodwill, many people will join.
Yeah, Charan's goodwill. Many people will join ArivuPro. They want to find out, not because teaching was good. They want to find out who is Charan. I want to be in his class. Then they will open Charan's fan club. Already they want to open? Charanism. Why? Actually, your friends still didn't understand that you are the smart one. Your friends have still not figured out that you are the smart one. Because they are the ones working there. You are the one chilling here. Evening, you will be the one hanging out and spending their money. No, actually, we had this discussion in the break, right? There is more information to this. He told me in the break. That information, if you get to know, you will understand. Charan is actually the smart one. And his uncle. Yeah. Here's one nice uncle. He was telling. You ask him in the break, he'll tell the story. Yes. Now, let's continue. Uncle will not come and write the exam. Uncle is doing everything, but he cannot come and write the exam. Let's focus. A and B are partners sharing profits and losses. Go to the end of the question first. Revaluation account and partners capital account. Correct? What is the ratio here? 3/4 and 1/4 means 3:1. Okay, balance sheet as at 31st March 2021. Can you see capital A, B? Okay. Creditors, general reserve. This general reserve we should distribute between whom? Old partners. Okay, cash in and cash at bank, debtors, stock, bills receivable, land and building, office furniture. And can you see only revaluation and partners capital? But this question was asked for 10 marks. Question was asked for 10 marks. That means there is something in this. Okay, now they agreed to take C into the partnership. When A and B are partners, is it necessary that always C only should come into the partnership firm? No, there are questions where even X is there. Clear? Yes, there is. Gone, but in the question. On the following terms, some things you have to understand on your own, okay? Charan, understood? What? X is gone. What? Whose birthday? Huh? What a timing to tell it, right? And he's laughing about it. Look at him. Why are you happy about it, man? I have never seen someone so happy about X birthday. I am 100% sure that is X also, right? He would have made her spend. No, there you spend. Poor friends are working, taking money from them, and spending money on the girl. We should actually put it on YouTube, no? Huh? Business. And he's happy about it. Why? Torture. Ah? For you, what torture, man? Your friends are working, don't worry. When did this happen? First year of what? That is 1 year back. You're telling as if it was many years ago. Okay, guys. Shh. See. Be like Charan. Wasim bhai, suddenly cough is coming for you. I like your attitude. He's so chill. Tomorrow what are you going to do? Are you going to send the happy birthday message or no? Blocked, huh? I can tell you an option. Huh? Yes. Free. You can still send a happy birthday message on Phone Pay or Google Pay. Huh? That is the spirit we require. Only 29 days more. Yes. Shh. How do you know, by the way? Okay, guys. Shh. Goodwill is to be valued at 2 lakhs. What does that indicate? Goodwill is to be valued at 2 lakhs. What does it indicate? That means you don't have to sit and compute the goodwill. Goodwill is already computed. C is unable to bring in cash for his share of goodwill. What will we do? Still we will take money. But it was decided that due credit for goodwill is to be given to A and B for their sacrifice. We should give the credit to A and B for their sacrifice in favor of C through C's current account. C's current account. No, it is not fixed capital. It is not fixed capital. I'll tell you, it's not fixed capital. Only thing is when you're giving, no, you're taking from C's current account. Look at this. First of all, you tell me 2 lakh goodwill. 2 lakh is the goodwill. What is C's share? C is admitted for what? 1/5 share. So into 1 by 5. That makes it 40,000. It makes it 40,000. So C has to give 40,000. C brought 1,40,000, right? We are not going to take from that 1,40,000. We will take from C's current account. Now have a look at this capital account over here. Can you see? These both are getting the goodwill into their capital account only. But can you see other side nothing is there? Usually here you will write to some partners capital account. Here you will write by. Here credit is there but no debit. Why? It is given through current account. That means if you see C's current account, in C's current account the debit will be there. From there it is debited and it is credited over here. Is this clear, guys? Are you following? That is one of the twists because of which this question was picked. Okay. So due credit of goodwill will be given to A and B. They never told put it to A and B's current account. Credit will be given to A and B, but it is given through C's current account. So if you see the capital, C's capital will remain at 1,40,000 only. It will not get reduced. Now after that, stock and furniture to be reduced by 10%. Okay, revaluation point. I'm not computing. You know how to compute it. So revaluation account will be debited or credited. It will be debited. So you can see over here revaluation account to furniture to stock. Find the values. Okay, find the values. Next, provision of 5% for doubtful debts should be created on debtors. What should be the creation here? Loss or profit. Again it is loss. So to provision for doubtful debts. Clear? Next. Land and building to be appreciated. Is it revaluation profit or loss? Profit. So here you can see the credit. Whatever profit is there, it is shared between A and B. It is not given to C because it is old partners only, and they did not reverse it because they did not speak about memorandum revaluation account. Now, partners capital account. Whatever this profit is there, can you see it coming and sitting over here? If it was fixed capital method, it wouldn't be sitting in capital account. It would have been in current account. Just because they have used the word current account, that doesn't mean it is fixed capital method. Clear? Now, if it was fixed capital method in the existing balance sheet only, there should have been current account. Can you see any current account here? No. Clear? Now, after that, capital of the partners are to be readjusted on the basis of their profit sharing arrangement. Who is the new partner who has come in? C. What is C's capital? 1,40,000. And for 1,40,000, what is his share of profit? 1/5. 1/5 is his share of profit. So if 1/5, that means what should be the total capital? 7 lakhs. Is it 7 lakhs? 1,40,000 into 1 divided by 1/5. Whenever you divide something by a fraction, it gets multiplied into the reciprocal of that number. So it will become multiplied into 1/5/1. This is 10 standard math. I had to tell you, but is this clear? 7 lakhs. Is it 7 lakhs? Yes. Now it will be shared by whom? A, B and C. In what ratio? Their new profit sharing ratio. Have they given the new profit sharing ratio in the question? What is the old ratio? 3:1. If you compute, no, it will become 3:1:1. 3:1:1. How to compute? I'll tell you. 1/5 is given to C. That means 4/5 is given to other partners. 4/5 is given to other partners in their ratio of 3:1. So when you do that, you will get 3:1:1. That means B will be 70,000, C will be 70,000, and A will be how much? 2,10,000. Sorry. I'm sorry. It will be 1,40,000, 1,40,000, and it will become 4,20,000. This is what? Required capital. What is it? Required capital. How will you get to know what is the existing capital? You have to check the capital account. When you check the capital account and you put everything, you will get the balancing figure. So you can write to balance carried down. That is fixed. Correct? Now, if at all a partner has more, that partner has to take money. If the partner has less, that partner has to bring money. But in this question, there also they said any excess or deficiency is to be transferred to current accounts. It should be transferred to current accounts. Can you see the transfer to current account here? A had less money, so A transferred from current account to capital account. B had more money, so from capital account he transferred it to current account. If at all those wordings were not used, here you would have written to bank, and here you would have written by bank. Are you getting this? So same surplus, you check the capital account, see the balance, credit balance. Okay, whatever is more, if it is more than what is required, then give the money to them. If it is less than what is required, then what are you going to do? You are going to take money from them. But here we are not taking literal money. We are adjusting it in current account because they told in the question. Is this clear, guys? Any doubt with this? This is making capital proportionate. If balance sheet was prepared, right? In this question, if they would prepare balance sheet, the current account impact would look like this. B's current account will be here. B's current account would have been 45,250, and A's current account will be here 44,250, and C's current account also will be here, that is 40,000. Did you understand this question? If balance sheet is prepared, how will it look? Here, capital account is credited. That means current account is debited. It is there on the asset side of the balance sheet. Here, capital account is debited. That means current account is credited. That means it's there on the liability side of the balance sheet. And these two got the goodwill share, but it was given through C's current account. That means C's current account was debited. That means it's there on the debit side of the balance sheet. Is this clear? So, if they ask balance sheet, current account impact will be this. Capital account impact, what will it be? In the partner's capital account, whatever balance carried on, that will be there in the balance sheet. Clear? Have you seen some questions when we go into dissolution and all? Current account is actually sitting on the asset side. That means it is debit balance. If it's on the liability side, that means it is credit balance. Clear? Are you following this, guys? Yes, that's it with that particular question. Let's go to the next one. That is retirement. We have reached retirement SM5. Okay, guys, get ready. Okay, question number 27. Do well LLP. Clear? With partners A, B, and C are sharing profits and losses in the ratio of 10:6:4. Can you simplify 10:6:4 and also write it as 5:3:2? Yes. The balance sheet of the firm on 31st March 2022 is as under. Balance sheet is given. Can you see A, B, and C? Their capitals are there. Reserve is also there. What should you do with reserves? Distribute it. Okay, all the partners. Now, this is your balance sheet. Now, it was mutually agreed that Mr. B will retire from partnership and in his place, Mr. D will be admitted as a partner with effect from 1st April 2022. This is retirement plus admission. Clear? Who is going? B is going. Who is coming? D is coming. If I am not wrong, where is that question? There is one more question which I want you to just have a look at. I think it is this one. See, K, L, and M are partners sharing profits and loss in the ratio 5:3:2. Due to illness, L wanted to retire, and in his place, who is getting admitted? N is getting admitted, his son. In this question, they said N is not bringing 1 rupee also. N is not bringing 1 rupee also. Whatever is there in his father's capital account, half will be transferred to his son's capital account. Other half father will take and go. Clear? Now, next question, we'll see this one only. Do well LLP. Now, when you look at do well LLP, can you see over here, it was mutually agreed that B will retire and who will come? D will come. It is admission come retirement. Someone had asked this question now in the brief. We'll see it now. Okay. For this purpose, the following adjustments were to be made. First, goodwill is to be valued at 1 lakh. Is this goodwill of that partner or goodwill of the firm? Goodwill of the firm is valued at 1 lakh, but the same will not appear as an asset in the books of the reconstituted firm. We always know that it will never appear. It will never appear. Okay, now, building and plant and machinery are to be depreciated at 5% and 20% respectively. It's a revaluation point. Investment are to be taken over by retiring partner at 15,000. This is a very important point. Now, how much is investment over here? 12,000. Retiring partner will take the investment, but he will take it at what value? 15,000. That means before he takes, investment has to be revalued. Now, if you see your revaluation account, can you see over here buy investment 3,000? Buy investment 3,000. Investment has to increase. Then he will take it, and when he takes it, when a partner takes an asset, partner's capital account has to be debited, and you can see in B's capital account, to investment 15,000. Can you see to investment? Very important point. So just because the partner is taking, don't directly pass the entry. First you go and check partner is taking at what value and what is the value that is there in the balance sheet. Is it matching? No. Then first make it match by doing the revaluation. Then you give the asset to the partner. Is it clear, guys? Yes. Now, next. Provision for 20% is to be created on trade receivable. Now tell me one thing. Building and plant and machinery are depreciated, right? Percentage, you know how to calculate it. Depreciated means loss, right? And provision creation means also loss, right? Look at the revaluation account. 2 building, 2 machinery, 2 provision for doubtful debts. Only one profit is that investment increasing. That means in this question there is loss. What will happen to loss? It will be transferred to partner's capital account. 30,400 came over here and 18,240 came over here and 12,160 came to C as well. Is it clear? Only reason I can think of why ICA has not done it in a tabular form is because A, B, C, D, you know, right? Four partners. Space constraint they would have had. Okay, in the printing of the material. That's why they did A, B, C, D below. Is this clear? Now, next. After that, in the reconstituted firm, total capital is 2 lakhs. Did you see that time I told you there are 3 ways to calculate the making capital proportionate? This is which one? Third one. The total capital is given. Total capital is how much? 2 lakhs, which should be contributed by A, C and D in their new profit sharing ratio of 2:2:1. Now, understand this, 2 lakhs in the share ratio of 2:2:1 will be 80,000, 80,000 and 40,000. 80,000, 80,000 and 40,000. So if you see, the partner's closing balance should be A's capital. Can you see it's 80,000? Balance carried down. B's nothing because B has retired. C's, can you see 80,000? Can you see D, it is 80,000. But what is the goodwill of the firm? 1 lakh. Okay, goodwill is 1 lakh. So goodwill 1 lakh into, what is C share in this? 1 by 5. That means 20,000. This 20,000 also C has to bring. So 40,000 to make his capital 40,000 and 20,000 to distribute the capital, distribute the goodwill. So total amount that C has to bring is 60,000. Are you following this? So if you see C's capital account, can you see in C's, sorry not C, I'm talking about D. D's capital account, can you see by bank 60,000 sitting there? So to make the capital proportionate, C has to have a capital of 40,000. And to give the goodwill, C has to bring 20,000. Now if C just brings 40,000, when you remove the goodwill, his capital will become 20,000. If his capital is 20,000, it is not proportionate. So to make it proportionate, his capital has to remain at 40 only. That means even after giving goodwill, if his capital has to remain at 40, he has to bring 60 so that when this 20 is given, his capital will remain at 40,000. Is this clear? Okay, next. Surplus funds, if any, will be used to repaying the bank overdraft. What does it mean? That means we are not paying the retiring partner. Amount due to retiring partner will be transferred to loan account, but surplus funds, whatever we have, we should transfer it to, we should use it to repay bank OD. Can you see one bank OD sitting over here? From where am I getting surplus funds? From where am I getting surplus funds? When you're making capital proportionate, each partner might bring money. Can you see over here? A's capital account, by bank, balancing figure, he is bringing money to make it 80,000. B's capital account, it is written, B is going. C's capital account, can you see by bank, he is bringing money to make it 80,000. D's capital account is bringing money to make it 40,000. Can you see this? Are you getting this? So all these are bringing money, no? That money that comes in, please use it. See over here. 2A, 2C, 2D, all are bringing money. So that money which is brought is by bank OD. That means you are using it to pay the bank OD. After that, whatever is there, please don't use it to pay the retiring partner. Put it into balance sheet. Retiring partner is not paid now. He'll be paid in the future. So whatever balance is there in retiring partner's capital account, it will be transferred to loan account and you'll find that loan in the balance sheet. You'll find that loan in the balance sheet. Is it clear? Then how these assets change their value? Do we know that? Revaluation. You have done the revaluation. Why can't I find investment in this balance sheet? Because it is taken over by B. It's taken over by B. And why there is provision for doubtful debts? Because we created provision for doubtful debts when we did revaluation. Is it clear, guys? Yes. And balance of bank, where did we get it? After we prepared the bank account. So if you notice this question, they have asked you to prepare revaluation account, partner's capital account, bank account and balance sheet. Clear? Even if you want in the exam, you also can do A's capital, B's capital, C's capital, D's capital down one below the other. But you are already adjusted to doing it in one stretch. So now don't do new experiment in the exam. Now if at all you feel your handwriting is big and you can't fit it in the one paper, please don't write horizontal. Like how you do in the notes, you'll just tilt it like this and you'll write horizontally, right? Don't write it horizontally. This is your answer paper. Left side debit, this side credit. Are you getting my point? Open the answer paper like this. This side you write debit side, this side you write credit items. Done. You can do that. Now, if at all you finish writing your answer over here, previous question, then your next question is starting over here. Now, don't please do this side debit side, turn the page, this side credit side. Are you getting my point? That fellow is going to go mad turning debit, credit. Even line he can't match. So, please keep it this way. If you can fit it in a page, that's the best option. That's the best option. But some people naturally their handwriting is big. They can't do anything else. Then the option is this. Is this clear? Yes. Partnership, retirement, SM practice question number 1. Food is not available. It will close later. With a heavy heart. Okay. Okay, I don't want you to lose food. Okay, take a break. Come back at 1:30. Their food will close, man. No other option. And please, when you go and have food, have light food. Okay, have light food. Yes, welcome back. Let's continue. Shh. Let's start. Chapter 1. Okay, guys, let's start. Shh. 28. We are moving into 28. Partnership, retirement. SM practice question number 1. Practice question number 1 from retirement. Yeah. Now, look at the question on 31st March 2022. The balance sheet of Ram, Rahul and Rohit sharing profits and losses in the proportion of their capital. They are sharing profits and losses in what proportion? The proportion of their capital. That means their profit sharing ratio is 3:2:1. Then you have other things in the balance sheet. On 31st March, Ram desired to retire from the firm and the remaining partners decided to carry on. It was agreed that revalue the assets and liabilities on the date as following. Land and building appreciated, shouldn't be a problem. Machinery depreciated. Closing stock to be valued at something. Provision for doubtful debts. All these 4 points are revaluation points. And see this one. This is little unique but revaluation point only. Old credit balance of sundry creditors of 10,000 to be written off. Creditor when you write off, is it profit or loss? Is it profit or loss? It is profit. Creditor, we have to pay. If they reduce, liability reduces, it's always profit. Can you see that creditor here? Okay. Next, joint life policy of the partners surrendered and cash obtained 60,000. Joint life policy surrendered and cash we are getting is 60,000. Now, what should we do with this money actually? It should be distributed to partners. It should be distributed to partners. Now you have 2 options. One, either put it into revaluation account or directly you can put it to partners capital. If you directly put it to partners capital, then you don't have to put it into revaluation. If you put it to revaluation anyways, it will go to partners only. It will be credited to partners. Can you see this? By bank, joint life policy. Either you put it here or directly write over here by joint life policy account and distribute it to all the partners, including the retiring partner, Ram, Rahul and Rohit, everyone. Clear? Are you following this? Yes. Next, goodwill of the entire firm to be valued at 1,80,000 and Ram's share of goodwill to be adjusted in the accounts of Rahul and Rohit who share the future profits equally. No goodwill account to be raised. What is the goodwill of the firm? 1,80,000. What is Ram's share? There is Ram. Ram 3/6. So can we take the share as 90,000? Now this 90,000 will be given to whom? Ram. It will be given by whom? Rahul and Rohit. In what share? In their sacrificing ratio. The new ratio is given 1:1, but old ratio was 3:2:1. So you will get some sacrificing ratio. Now if you see over here, can you see 2 Ram's capital account? That means this is coming up to 1:2. The ratio is 1:2. And can you see Ram's capital account? Where is, okay, they have not prepared Ram's capital account. Ram's capital account they have shown as working note. Can you see here? By Rahul, by Rohit, he is getting the goodwill share. Clear? This is revaluation profit share. This was the balance brought down. Okay, then they told at the end of the question that whatever is there, 50% to be settled on retirement and 50% will be transferred to loan account. Can you see 50% you have written to bank and remaining 50% gets transferred to Ram's loan account, and this Ram's loan 2,10,000 should be found in the balance sheet. Ram's loan should be in the balance sheet. Clear? Next, Prepare revaluation, partners capital and loan account and cash account. That's it. Now they told us very important point. Total capital of the firm is to be same as before retirement. Individual capital to be in profit sharing ratio. What is the total capital of the firm before? 6 lakhs. That means after retirement also the capital they wanted to be 6 lakhs only. And this 6 lakhs has to be in the profit sharing ratio, which is 1:1. So that means it should be 3 lakh, 3 lakh. Now if you see Rahul and Rohit, their capital is actually 3 lakh, 3 lakh. But to make it 3 lakh, 3 lakh, they had to bring money. See the money that is bought in 1,10,000 and 2,50,000. Is it clear? This is actually the balancing figure. When you prepare the partner's capital account, you'll get to know how much which partner has to bring in. Are you clear with this? And loan account they asked you to prepare. But what is there in the loan account? Just the amount comes here and then balance carried on. That's all. Ram's loan account is created, but there is no interest or anything. That will happen in the next year. This is your question on retirement, guys. Very important part is this one. Making capital proportionate. And you have to compute the sacrificing ratio, which is old ratio minus new ratio. Both are given in the question itself. That time you will get to know, because sacrificing ratio is coming up to 1:2. Old ratio over here, if you see, it is 2:1, 3:2:1, right? Yeah, so you will not get it directly. You have to compute it. Yes, that's your question, guys. Next question, 29, retirement, SM practice question 2. This one is. Here they have asked journal entries ABC were in partnership sharing profits and losses in the ratio of 3:2:1. The balance sheet of the firm as on 31st March, it is not February, okay, because there is no 31st February. Even if you want to, you can't consider that. 31st of March 2022 was as under. Oh, wait, is it a typo from my side or is it actually like that? No, practice questions 2, right? Oh, here also it's wrong. Okay. ICA stuff. Just ICA doing ICA things. Yes, now. These are the capitals. These are the assets. This is the liability. Now go to the end of the question and see what they have asked. You are required to give necessary journal entries to give effect to the above arrangements. Prepare capital account of partners, cash account, balance sheet of B and C after giving effect to the above arrangements on the retirement of A. Clear? Now, over here, A on account of ill health gave notice that he wished to retire from the firm. A retirement agreement was therefore entered on 31st of March, the terms of which are as follows. Now you have to see the retirement agreement. First one, profit and loss account for the year 31st March 2022 was to be reopened. Can you see? Was to be reopened. Why are they asking you to reopen the profit and loss account? That means there is something that they have missed. They have to rectify something. B was to be credited with 6,000 as bonus in consideration of the extra work which was devolved upon him during the year. The profit sharing basis was to be revised and revised ratio is 2:3:1. From when? 1st April 2021. When did they give you the balance sheet? 31st March 2022. What did they write over here? Profit sharing ratio 3:2:1. What are they telling is the profit sharing ratio here? 2:3:1. That means this is totally not relevant for us. 3:2:1 is not relevant. Okay, that means by mistake they have distributed in 3:2:1. We have to bring back the profit. After bringing the profit back, we have to give bonus to B. After giving bonus to B, then we have to redistribute it in the ratio of 2:3:1. Clear? Now if you see over here, partners capital, I'll explain to you from P&L adjustment onwards. Did they prepare P&L adjustment? No. Okay. They've just passed journal entries in this question. Now, to bring the profit back, what should you do? You should debit the partner or credit the partner. To bring the profit back, that means to take the profit back, partner's capital account is debited and P&L adjustment account is credited. Can you see? And this is in the ratio of 3:2:1. 3:2:1. That means it was distributed by mistake in 3:2:1. So you take it back in 3:2:1. Then you give bonus. Bonus to whom? Only one partner, that is B. B is supposed to get 6,000 bonus. So P&L adjustment account debited to only B's capital account. Now remaining profit should be distributed. But when you are distributing the remaining profit, ensure that it is distributed in the ratio of 2:3:1. It is distributed in the ratio of 2:3:1. So can you see 36,000 is distributed in the ratio of 2, 3 and 1. 12,000, 18,000 and 6,000. Is this clear? This is why they asked you to reopen the partnership. Reopen the profit. Bring it back in what ratio it was given. Give the bonus, but when you redistribute, you have to redistribute in this ratio, that is 2:3:1. Clear? Now, goodwill was to be valued at 2 years purchase of the simple average profit of the 5 years. Shouldn't be a problem. Just total this. You will get the total. That is 15 plus 23 plus 25 plus 35 plus 42. 140. 140 divided by 5. That is 28. How many years purchase? 2 years. That means 56,000 should be the goodwill. 56,000 should be the goodwill. Is it clear? Now 2 years purchase of the simple average profit of the 5 years. So 56,000 if it is the goodwill. Who is the partner who is retiring? A is retiring. And what is A's share? Is it 3/6? No. We have to see the new one. That is 2/6. So 56,000 into 2/6. 18,000? 667. Okay, 18,667. Now if you see, where is A? Okay, they have not done the goodwill adjustment now. 18,667. Now go in the order. They have just given it at the end. 18,667. But it is given by B and C in what ratio? In their sacrificing ratio. You have to compute sacrificing ratio. You will get it that time. Clear? For the sacrificing ratio, your old profit sharing ratio will not be 3:2:1. It will be 2:3:1. And the new profit sharing ratio. What is the new profit sharing ratio? Did they give you the new profit sharing ratio? Yes, 3:1. New profit sharing ratio will be 3:1 between only B and C, and this is between A, B and C. So that means by default, can I tell that the sacrificing ratio will be 3:1 only? Can you see over here? These both were in 3:1 ratio, and these both here also are in the 3:1 ratio. So when you calculate, it will be 3:1. Can you see over here it is in 3:1? If you take your calculator, 18,667 into 3/4, are you getting 14,000? Yes, it's in the ratio of 3:1 itself. Now after that, some important things. Fixtures to be valued at 39,800 and a provision of 2% was to be made. So for that, what should be the entry? Fixtures account debited to actually, fixtures has to be valued upwards, right? Now fixtures to revaluation, then revaluation to PDD, then whatever is there in revaluation, you should transfer it to partners. What have they done over here? Directly, fixtures account debited to PDD to A's capital, B's capital, C's capital. Are you getting this? Net effect are you getting? But you can actually pass it through revaluation itself. Okay, because just because ICA has done it over here, if you go to do it again, right? In some other solution, ICA would have done it in the other way. So use the regular method what you always follow. Fixtures to revaluation to PDD, then revaluation to partners capital account in their ratio of 2:3:1. The changed one. Clear? Then if you see, little down, if you see, amount payable to A shall be paid by B. Amount payable to A shall be paid by B. That means, are they literally paying it? No. From one capital account it is going and it is falling into another person's capital account. Now, you have to use your calculator and find out how much you have to pay to B. Can you see B's capital here? 1 lakh. Take 1 lakh in your calculator. Clear? Then, can you see that first time when we took the profit back, 14,000 was debited minus 14,000. Then we gave B bonus. Oh, wait. A is the retiring partner, right? Not B. A is the retiring partner. Take 1,50,000 in your calculator. 1,50,000. Okay, then you took 21,000. So minus 21,000. Then this is B. Then you gave 12,000. So plus 12,000. Then you gave 2,667. So plus 2,667. Then here nothing related to B. Nothing related to A. How much are you getting? 143,667. Okay, but is there any goodwill entry? A goodwill entry they passed later. Total bakwas by ACA. Here they have given and then they pass the goodwill entry. So add this 18,667. Are you getting 162,334? 162,334. B told, don't worry, I will pay it from my pocket. So we have removed the capital account of A and we have transferred the money to B, because who was supposed to pay to A? Who was supposed to pay to A? In reality, firm was supposed to pay to A. Because firm is not paying, B paid. That means who is supposed to pay B now? Firm is supposed to pay B. That's why B's capital has increased. Is this clear? Now, only in this question you will find this additional adjustment, okay? B and C agreed as between themselves to continue the business, sharing profits and losses in the ratio of 3:1. Profits and loss in which ratio? 3:1. And decided to retain fixtures in the books at revised value. Okay, let it remain at that only. But, and increase the provision for doubtful debt to 6%. Here, how much was the provision for doubtful debt? 2%. They want to increase it to 6%. That means another 4% provision they need to create. Now, if they are going to create provision, right? Is it going to be borne by A also? A already went. After A goes, B and C are only there. That time they want to increase the provision. So is this loss going to be borne by A? No, it's not going to be borne by A. Now what is going to be the situation? B's capital account debited, C's capital account debited to provision for doubtful debts. Is it clear? If you're wondering how did we get the amount, here the debtor balance is 90,000. 90,000 into 4%. 3,600. And their ratio is 3:1. B and C, their ratio is 3:1. That is why it is 2,700 and 900. Is this clear, guys? Are you following this? So only this question you will find that after a partner has retired also, there is one extra transaction. Now, you are like, sir, can't we actually prepare revaluation account again for this? For this, can't we do revaluation account debited to PDD and then write by partners capital account and write B and C? Can we do that? Yes, we can do. Yes, we can do. Okay, just that one transaction is there, no? And that is also after retirement. That is why what they have done, they have directly routed it through the partners capital account itself. Are you following this? Yes, that should wait, guys. Next, retirement, December 2023 exam. For this only I had kept this question. December 2023. Did you have heavy lunch? Of course you did. Look at your faces. What? No, sir. You don't know who retired only in the previous question. Who retired in the previous question? Yes. So this question is about X, Y and Z. December 2023. 5A. How are you getting it? Oh, you have the question paper. Okay. You directly searched. I can't do that, man. Even I am feeling bad about that option not being there. 5A. This is the question, no? Okay, guys. Now, question is very simple. Question is very simple, but the reason why we are talking about this question is because of we have seen one situation where capital is going to be made proportionate by keeping somebody's capital as base. We have seen one more situation where they only give us the capital and tell keep it in proportionate basis. Now, the second situation, that is they don't tell anything but they just tell that capital has to be proportionate. We have not seen that. Correct, no, Charan? Yes. What happened, Charan? Today you didn't have the same meal what you had yesterday. X, Y and Z were partners sharing profits and loss in the ratio 5:3:2. Can we conclude that this is old profit sharing ratio? Yes. Their balance sheet as on 31st March 2023 is as follows. Correct? Balance sheet as on 31st March 2023. Clear? You have all the partners capital account, general reserve is also there. Y retired. Who retired? Y retired. from the business on 1st April 2023 on the following terms. Revaluation points I'm not going to discuss because you know what to do about it. Okay. Appreciate building by 20% to depreciate machinery by 5%. Then provision for doubtful debts, it should be created at 10%. Now, goodwill of the firm is valued at 1,60,000. Goodwill of the firm. Okay. And goodwill is not to be raised in the books. New profit sharing ratio is 5:3. So if goodwill of the firm is 1,60,000, what is Y's share in that? 3 by 10. What is Y's share? 3 by 10, 48,000. Correct? Goodwill of Y is 48,000. And who has to give this? X and Z. And what is X and Z? Their share after this 5:3. So X, Y, Z. It was 5:3:2. X and Z. It is 5:3. Can we get the sacrificing ratio directly in this question? No. Can you get it directly? No. Because between X and Z before it was 5:2. And now it is 5:3. So you'll have to compute it and get the sacrificing ratio. Okay. But how much is the share of goodwill of Y? 48,000. Okay. Have a look at this. Can you see? 20 plus 28. 48,000 goodwill is given to Y. 20 plus 28. Are you following this? Yes. Now, after this, the very important thing is entire sum payable to Y should be brought by X and Z in such a way to make their capital proportionate to the new profit sharing ratio. Balance of Y to be paid immediately. Now, how are you going to get to know how much is to be paid to Y? If you just check Y's capital account, you'll get one balance here. 3,11,400. This much money has to be brought by X and Z. Now, in what ratio will X and Z bring money? No.
Gaining ratio.
No. No.
Sir, first should pay, sir, right?
Huh?
First should pay.
In what ratio? Now, did you understand the question? Now, Y is retiring. Whatever is there in Y's capital account, unless either you pay it or you transfer to loan account. Correct? They told that it has to be paid. And to pay, if you look at the balance here, only 25,000 is there in the bank. So, whatever amount is required, that has to be brought by whom? X and Z. Now, when you see Y's capital account, if you balance Y's capital account, say this is goodwill, this is revaluation, this is the reserve share. Okay? When you do that, you are getting 3,11,400. This 3,11,400, who is going to give? X and Z. In what ratio will they bring money? Now, do you agree with me that 3,11,400 minus, do you already have some money in the bank account? Yes, 25,000. Can you find this? 2,86,400. 2,86,400. Is that correct? Is this the amount to be brought? Did we sell anything else in this question? Is there anything else? No. Are you getting it? 3,11,400 has to be paid. Can you see two banks sitting over here? But my question is, who has to bring how much? See, these two are bringing money. 3,11,400, they are bringing money. In what ratio did they bring money? If you find this, you'll get one chocolate. In what ratio will you find it? Is it given? Is it even in any ratio? I'm curious to find what ratio it is. What ratio is it?
3 by 6.
Guys, money brought. For that there is no ratio. When making capital proportionate, you have to see how much money is required and just bring.
Interest of their shares. Combined capital.
Yes.
Combined capital.
Basically, you have to do asset is equal to liability plus capital. Asset you know. Do you know all the assets? Yes. There are few assets here. Okay, some of them have gotten revalued. When they have gotten revalued, you know the new values. Liabilities, do you know? Only one trade creditor is there. Clear? When you do asset is equal to liability plus capital, that time you will find the capital, combined capital. When you know the combined capital, you know that the combined capital has to be in their profit sharing ratio. They told that it should be in the ratio of 5:3. Clear? Now can you see this ratio is 5:3 between the combined capital? Now you know the ratio is 5:3. This is just balancing figure. If they have less money, they have to bring it. If they have more money, they have to take it. That is what is meant by making capital proportionate, no? Ensure that the capital is proportionate. If they have more money, it's surplus, take it. If they have less money, deficit. Here 100% there will be less money only because they have to pay this fellow, no? They have to pay this fellow. Now see this, what they have done, ICAI. Bank account still maintained at 25,000. Okay. Why is this? Do you remember that there are some questions in your retirement study material where they tell you, bring enough money to pay the partner and increase the capital, increase the bank balance to 50,000 or something like that. Correct? So here they have ensured that the old bank balance remains. That means whatever is required to pay, full amount is brought. If at all we can use this old bank balance, this should become zero and they will bring only 2,86,400. Is it clear? Here they brought how much? 3,11,400. Why did they bring 3,11,400? Because 25,000 is not utilized. That is why 25,000 is still there in the balance sheet. Have they told in the question? They said entire sum payable to Y should be brought by X and Z. Entire sum, bring it. Old balance, leave it. Let it be there for future expenses. Are you getting this? So that is why here you can see 25,000 is still there. Are you following this? So bringing the money, when making capital proportionate, bringing the money, is it in old profit sharing ratio? No. Is it in new profit sharing ratio? No. Is it in capital ratio? No. Is it in gain ratio? No. Is it in sacrificing ratio? No. Is it the firm's responsibility? No. It has to be brought by partners. In which ratio? You find the amount and then see how much capital is there. If it is more, give it. If it is less, take it. Are you following this? So this is the third methodology. Now making capital proportionate. Making capital proportionate. What was the first one we saw? Keeping one partner as base. Second one is asset is equal to liabilities plus capital. Third one is given. Directly they have told what is the capital, just make it proportionate. That's all. Clear? This is your December 23 question. Let's go further. Finally, we are done with retirement. We are only left with death of a partner and dissolution. You told no that you wanted swing. Huh? So first. Because of your swing only, she got up and went back. Huh? Now swing is stopped. They can do anything indirectly. Total down. He is telling the state of the class right now. Total down. Clear? Done? Now, death of a partner is, if at all you ask me, what is the most trickiest area in partnership? It's actually death of a partner. Because in death of a partner, there are some unique kind of questions where they can test you. Okay, but what is going to happen? Regular. We have one question over here, practical question, and then we have one June 2023 question. Only 2 questions from death. That's it. Then dissolution. That's it. Let's continue, guys. Sir, online students, are you back? Yes. They were lost first because their Zoom link got disconnected and then it was created. Hello. Welcome back. We are here only. Good morning. Yes. Hey, they also have a problem with the AC. So it's good, no? If you are sitting in the AC, it'll get dry, no? See, then when you got up from here and went back, you should have sat in middle place somewhere. There is no AC. You got up from the... So I'll tell you the right place. You should have sat in that third bench. Coming from there. Technology. I don't know this technology. Yeah. If at all that, if it is going that side, why that air is not coming this side? Huh? How about we shift to that class?
That morning I went to because
There you are getting any AC? But there it is very good. Why? Reason you tell me. Is it? Question number 31. Partnership debt practice question. Okay. Again, it's an important question. Now, listen. What did they ask you to find out? You see, no revaluation account, no partner's capital account, no balance sheet, nothing. They just told, please prepare an account showing the amount due to Peter's legal representative as on 30th September 2022 along with necessary workings. Is that clear? Now, understand this. Peter, Paul and Prince. Correct? Only one practice question is there in... only one practice question is there. Now, here you have to be a little careful. Oh, there are two. Sorry. We want the second one, I think, no? Now, everything we will discuss. This question. Okay, everything we'll discuss. Now, understand this. Peter, Paul and Prince were partners sharing profits and loss in the ratio of 2:1:1. What is this? Old profit sharing ratio. It was provided in the partnership deed that in the event of retirement or death of a partner, he or his legal representatives would be paid. Now, the balance in the capital account. Whatever is there in the capital account, obviously you have to give it. Next, his share of goodwill of the firm valued at 2 years purchase of normal average profit after charging interest on fixed capital. That means the profit which would have been given to you in the question is before interest. You have to remove the interest, you'll get the profit after interest. For the last 3 years to 31st December preceding the retirement of death. Did you see one question today that they told till the date of death? Here they told preceding the date of death. That means if a person has died on 30th of June 2024, the profit will be calculated only till 31st of December 2023. Average profit of last 3 years. Is it clear? Now, his share of profit from the beginning of the accounting year to the date of retirement or death, which shall be taken on proportionate basis of profits of previous year, has increased by 25%. What is this circus? Person died somewhere during the year, right? Now, during the year, if someone dies, can we know the profit of that year? No, because profit of that year will be computed at the end of the year. So they told, do one thing, take last year's profit. There are some questions in death where they have told, give it on the basis of average profit of last 3 years. There are some questions where they have told, just give it on the basis of last year. Here they have told, give it on the basis of last year, but add 25% to that. Is this clear? So profit share you have to give till the date of death, but add 25% to that. Now, interest on fixed capital at 10%, though payable to the partners, will not be payable in the year of death or retirement. What is this? No interest on capital. In the year of death or retirement, we are not going to give interest on capital itself. Are you following this? Clear? Now, all the assets are to be revalued on the date of retirement or death, and the profit or loss to be debited or credited to capital account in the profit sharing ratio. We know that revaluation profit will always be in PSR only. Now, Peter died on 30th September 2022. When did our year start? We don't know. Are we following calendar year? Okay, we don't know. But we know in the next line, books of accounts are closed on calendar year basis 1st January to 31st December. That means 9 months profit we have to give. But should I give 9 months interest on capital?
No.
Why? Because they said if in case of retirement or death, no need to give. Correct? Yes. Balance in fixed capital account. Who died? Peter. How much is the balance? 10,000. Go and see the solution. Can you see you're transferring 10,000 to Peter? You have to prepare one capital account. Did they prepare it? Yes. Can you see balance was 10,000? Are you following this? Peter's capital account balance was 10,000. Now, after that, they have prepared capital account and current account. Capital account and current account. Ultimately, whatever is there in capital account or current account, everything should go to partner. Partner is not there, so should go to executor. Now, next. Balance in the current account as on 1st January is Peter 20,000. Peter's current account only. We are not bothered only about others' current account. We are only trying to find out how much should be paid to Peter. Now, 20,000. Can you see Peter's current account balance brought down? Next. Paul and all you forget. Drawings of Peter till 30th September was 10,000. Peter has taken 10,000 drawings. So what should happen? Balance should reduce. Can you see 2 drawings over here 10,000? Next. Profits of the firm before charging interest on capital for the calendar years were 1 lakh, 120 and 150. They gave the profits. For what purpose they gave the profit? Reduce what? For what purpose they gave profit? For what purpose they gave profit? What heavy food did you have that you don't even know that profit is given to calculate goodwill? Profit is given to calculate goodwill. For that purpose, see here, goodwill, 2 years purchase of the average profit of last 3 years. When I told normal average, everyone, yes, you were telling. Profit is given to calculate goodwill. Good morning. Now, the profit of the firm before charging interest on capital is given. Now, interest on capital is not charged. So, you have to take the average after charging interest on capital. Now, can you see the profits here? The profit include following abnormal items. If there is abnormal item, what should I do? Deduct it or whatever. Profit on sale of asset, insurance claim received. Do you agree both are incomes? So, minus, 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 minus. Everything should be subtracted from the profit. Then only you will get the correct profits. Are you getting this? Okay, now if you go and check profit calculation. They have done the profit calculation. See, goodwill. 1 lakh, 120, 150. Less, less, less. Interest on capital. Then profit on sale of asset less. Insurance claim less. Why? These are all abnormal incomes. It was added. Now you are going to reverse by subtracting. Interest on capital 20,000. 20,000 is the capital. Can you see the capital here? 10,000 for Peter, 5,000 for Paul and 5,000 for Prince. That means total capital is how much? 20,000. On that 10% is how much? 2,000. Can you see interest on capital over here? 2,000, 2,000 subtracted every year. Now you must be thinking, sir, they told no. Interest on capital not to be given in the year of death. We are not giving in the year of death. This is all prior years. Prior years for goodwill calculation, we are using that. Are you getting that? Now you are getting the profits. Is it in any trend? Can you see it's in trend? Increasing trend. But they told what? Normal average profit. So you just take the total profit divided by 3. You got the average profit. 2 years is the number of years of purchase. You get goodwill. This goodwill is what? Goodwill of the firm. Goodwill of the firm. Peter's share was what? 2 by 4. So half the goodwill will go to Peter. Half the goodwill should go to Peter. Who is going to give this goodwill to Peter? Who is going to give the goodwill to Peter? Paul and Prince. Firm will not give. Paul and Prince. Clear? Now go to this. Can you see 1,07,000 share of goodwill given to Peter? Now, after that. Okay. Firm had taken a joint life policy for 1 lakh. Very good. Joint life policy. Besides, the partners had severally insured their lives for 50,000 each. That means there is one joint life policy for 1 lakh. You will get full amount. And each partner has taken 50,000. So 50,000 on the life of Peter. You will get full amount. 50,000 on the life of Paul. You will not get full amount because Paul did not die. You will get only surrender value. Can you see surrender value of the policy is 30% of the face value. So this you will get how much? You will not get 50. You will get only 15,000. And the insurance which is there on the life of Prince, that also you will not get 50, you will get only 15,000, 150, 180. Total amount that you are going to get from joint life and separate life policies, 1,80,000. 1,80,000. Will full 180 go to Peter? No, only half. 2 by 4 will go to Peter. That means how much should go to Peter? 90,000. Correct? Can you see 75 and 15 here? Why separate? One is separate life policy and one is joint life policy. Clear? 75 and 15, 90,000 will go to Peter. Now, apart from that, then what did they tell? Can you see over here? Premium in respect of the policy was undercharged to the extent of 6,000. What does undercharged mean? We made a mistake of not putting one insurance at all and 6,000 in the year 2021 and the firm had to pay it immediately. One of the previous years, by mistake, we have not charged insurance at all. Okay, now we have to remove that 6,000. Okay, this 6,000, will it affect the goodwill calculation? Yes. Can you see in goodwill calculation that 6,000, it should be taken? Can you see 6,000 here? All abnormal items and all rectifications should happen when you are doing goodwill calculation. 6,000 was not taken. Is this an abnormal item or is it a rectification? We are not playing Konman and Karapati that you randomly guess it. You know, you need to think and tell. Is it an abnormal item or rectification? It is a rectification because paying insurance policy for fire insurance, it's not an abnormal item. It is business expense only. But they forgot to pay 6,000 and now they are paying that. Because of that, what happens? 6,000 has to be charged now. If 6,000 is going to be charged now, don't you think that rectification has to impact the partner also? Are you getting it? So now if you see Peter's current account, can you see 3,000 over here? Because out of the 6,000, half the share is Peter's. So loss should be debited to partner. That is why this 3,000 is debited to partner. Is it clear? Now after that, revaluation of assets indicates upward revaluation of 20,000. If revaluation profit is there, should we give it to all partners? Should we give it to all partners? Revaluation profit.
Yes.
All partners? Yes. All are old only now. All partners? Yes. Now who are we talking about? Peter. How much is Peter's share? 2 by 4. That means 10,000 should be given to Peter. Can you see profit on revaluation 10,000 here? Now, this is generally transferred to Peter's current account, but as per requirement of adjustment number 5 of question, it is transferred to capital account. Adjustment number 5. All assets are to be revalued and profit and loss should be debited or credited to capital account. That is why that one thing is sitting in capital account and all other things are sitting in current account. It doesn't matter because ultimately capital also gone, current also gone, everything will go to executor. Are you getting this? Now, only thing that is remaining is you calculating the profit share. How to calculate profit share till the date of death? Point number 3. How to calculate profit share till the date of death?
From the previous profit, we should add 20.
Yeah, for the previous year's profit, we should add 25%. Clear? Now, not average profit, we should take the last year's profit. Now, if you notice, what is the last year's profit? 1,20,000, but I can't take that because there are some corrections to be made. Now, have a look at the profit calculation. Profit is 1,50,000 of 2021. Profit is 1,50,000 of 2021. Can you see 1,50,000 here? Yes. Now, that profit, will it be subject to a rectification of error? Is there any error of 2021? Yes, that fire insurance which we have not done. So minus 6,000, your profit will now only be 1,44,000. To that you add 25% increase. So now your profit becomes 1,80,000. But this profit is before interest. Now interest on capital has to be subtracted. Now you are like, sir, no need to calculate interest in the year of death. That is only for Peter. But Paul and Prince are still there, no? So subtract the interest on capital. Paul and Prince, their capital is only 10,000. So on that 10%, 1,000. Now you are left with capital of 1,79,000. Is it 1,79,000? Yes. 1,79,000 is the profit for the entire year. So 1,79,000 into 9 by 12 into Peter's share of 2 by 4 should give you 67,125. Is giving you 67,125. What is the journal entry? What is the journal entry? Yes, 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 yes. What is the journal entry? Profit share till the date of death. What is the journal entry? Huh?
Profit and loss expense account. That profit and loss expense account debit to
Executive will come later. Now it's partner's current account. Fine. P&L suspense account debited to. Can you see share of profit they have written? But it is P&L suspense to partner's current account. Now whatever is there in this partner's current account and whatever is there in this partner's capital account, both of these items will go where? To partner's executor's account. Can you see executor's account? These two numbers, balance carried down. Why balance carried down? Anywhere they did not tell you how to pay now. You can pay later. Clear? This is the question. Was it difficult? Was it difficult? Yes, right? Then you wake yourself up because the next one is this fellow's father. Okay, June 2023 was asked only for 20 marks. Was asked only for 20 marks. 20 mark question in the exam. June 2023. If you don't see this question and go, bamboo only. I'm telling you. And guess what? Nothing is bouncer. Nothing is bouncer. Only thing is all the tricky adjustments from different places, they have merged it into one question. And death of a partner. How did it turn off?
They're like it with
So now it is.
Huh?
Now.
don't want that.
So now it's.
You only told me you wanted swing. Okay. Yeah. So June 2023 exam, we are back. 20 marks. Very simple question. Okay. Very simple question. Focus. This can also appear in your exam. No? No, Nida. You should always hope for tough questions in the exam. That is if you study. Otherwise, tough or easy, what difference it makes? Tough or more tough? See, 20 marks. Only 20 marks. Now, only three things they asked, okay? Partner's capital account, partner's current account, and balance sheet. For that, they are giving 20 marks. What madness! When you see this, you'll realize why it is 20 marks. Now, full focus. Okay, absolute focus on this question. Last question of death of a partner. After that, dissolution. Dissolution is too silly. Okay, nothing is there in that. What you are doing? You are just closing the, pulling the shutter and going off. Correct? It's in perfect angle. Now it's hitting me. That's why I like that class. No fight for AC at all. One AC is there. That will always remain in 16. And you always be hitting me. Done. Finished. Huh? Buffalo skin. You ask them. I have told some stories of regular classes. There is no concept of feeling cold. Huh? There is no concept of feeling cold. Like sometimes when I go back in the night, right, I'll be too tired, especially after the regular class. I used to feel more tired than marathon actually. Yeah. No, that is not because of those students. It was because when the regular class was going on, I used to get up at like all 3:30 in the morning and all. Because I have a class at 6 to take CA final. So I used to prepare materials for them and all that. So I used to get up very early. So after that, I have to come back and take class for these guys in the evening. Okay, then that's why I used to go back and I used to be very tired. So I used to just sleep. Sometimes I just wash my face and freshen up and just sleep. So when I'm sleeping, right, I ensure when I enter the room, I used to put the AC on 16 and I sleep without even using a blanket in 16. And I'm getting up in the morning straight at 3:30 for the alarm. Nothing used to happen. Nothing will happen, guys. What? Kashmir attire. No, see this t-shirt. Nothing will happen. Actually, cold weather is good for health. Cold is good for health. Huh? And by the way, I didn't tell you, no. At 3:30 I get up. Then at 5:30 I have to take bath to go to class, right? At 6 o'clock. Now that am I having cold water only. Bath. I mean, I'm from Mangalore. So for me, in only half the year I get cold water in Mangalore, okay? Because half the year it's summer, half the year it is raining. When it is raining, if you have solar, whatever also, it will be cold water only because there is no sunlight only for solar to heat. But during summer, if you don't have solar also, in the tap hot water only. Okay. So half the year there is no option itself. Okay, you will get hot water in the tap, whatever you do. Other half of the year, no, rainy season. Crazy. Outside it will be raining and cold water in the tap. Next level. It's good, guys. It's good. In fact, there was one phase in my life, okay, where I used to be too much into working out and all that. Okay. Now everything is stopped. Now, so in that, when I used to do too much exercises, right? After that, for muscle recovery, it's always good to have cold water. So what I used to do is, I used to keep like lot of ice in the freezer. And when I finish my workout, I should take all that ice, put it onto the bucket. Okay. That water will be like chilled. Trust me, the motivation for me to work out was that ice water bath at the end. Every day, next day when I used to think, no, should I work out or not, feeling lazy. That ice water bath used to be like, after that I can do this. But that feeling is too good. And trust me, immediately you will recover. Or you'll go. Some of them are thinking, oh, already they are feeling cold listening to the story only, right? Yeah, but it's good, man. It's good for health. Actually, it's good for health. Only old people, actually, hot water is good for it. Because they need that, little steam for the bones and muscles and all, right? Relaxation. But for you, it's good. It'll make you alert. We should send you now back to your PGs and give 15 minutes to take cold water bath and come back. 15 minutes or your cold water bath means you'll finish in 5. After reaching there, I'm talking. Full total time, no. Only effective time. See, like total time you sit in ICU batch for 12 hours. But effective time of study we are considering, no. 4 hours. Yes. Okay, guys. Now, complete focus. Yes, Janvi, can we focus? If at all you don't like AC, right? Just tell Janvi. She knows some spiritual skills. Some black magic and all she will do. And AC will stop working on me. In that class, 1 week it stopped working. One day she felt cold. She did some black magic. 1 week it didn't work. They had to literally buy one new AC after that. Still it was not working. Then 2 days she was absent. Then the power of the black magic went down. Okay, then it became proper. Morning? Yeah, from online also she used to. Okay, guys. Just hearing the AC. Online also she used to put in chat box, you know. Sir, how is the AC? Within 10 minutes, damar. Yes, A, B and C were trading in profits and losses in the proportion of 4:3:3. Listen, full focus to this question. Lot of things are different. Not 1, 2. Lot of things are different here. Balances in the books of the firm as on 31st December 2022 subject to final adjustment. Oh. Subject to final adjustment means something is missing. Now, what they gave, there only you are shaken. What they give, usually in partnership question, what do they give to start? Balance sheet. What did they give here? Trial balance. What did they give you? Trial balance. For which year? For 2022. Do you agree this is the trial balance for 2022? And this is their capital account balance. This is their current account balance. Why capital and current are doing Gangnam style there? Why? Why? One is credit, boss. Other one is debit. That is what we are doing in this subject. Debit and credit. Clear? Now, all these credit items transfer to capital account. Clear? Now, can you see in capital account, balance brought down, balance brought down, balance brought down. And in current account, balance brought down, balance brought down, balance brought down. Because there is debit balance. Clear? Simple one that is. Now, after that, profit for the year, land, building, stock, creditors, everything is there, let it be. Okay, profit for the year is 2,34,000. Which year? Before interest, yes. Which year it is? This is 2022 profit. Clear? Creditors. That's it. Now you see. Simple things, okay? Goodwill may be recorded separately instead of through revaluation account. We never put goodwill to revaluation account. We always route it through partners capital. C died on 30th June 2022. Exactly middle of the year. Okay. Planning was proper. 6 by 12 we can do no. That is what. Okay. Partnership deed provided that. Now see their partnership deed. Beautiful partnership deed. Okay. Interest was credited on capital account of partners at 12% per annum on the balance at the beginning of the year. Are they telling us that whatever balance is there at the starting of the year, on that we have to give interest at 12% per annum? Yes. Now, on the death of partner, so you are watching on the which point are we in? This one, to creditors. Paragraph. So you're watching. Now, on the death of a partner. Now listen. Did we establish the fact that interest on capital is 12%? Yes. Yes. On death of a partner, goodwill was to be valued at 3 years purchase of average annual profits of 3 years. You take the average of 3 years and also 3 years purchase. So multiply also into 3. You have to divide also by 3. Up to the date of death. Have you seen this before? Up to the date of death. In the goodwill chapter, was it there? You have to take half, middle 2 years, full. After deducting interest on capital employed at the rate of 10% per annum. Just now they told 12%. Now they are telling 10%. Normally we are giving 12% interest, but if you are doing goodwill calculation, we are going to give only, for goodwill calculation, take only 10% per annum and a fair remuneration for each of the partners. Clear? So normally interest rate is 12%, but for goodwill, 10%, only for goodwill computation. Clear? Now, fixed assets were to be valued by the independent valuer and all other assets and liabilities to be taken at book value. Okay. Somebody will value the assets, no problem. They will tell you the value, you just do the entries. Next, whenever necessary, profit and loss to be apportioned on time basis. What does it mean? If you want to do 3 by 12, 6 by 12, 2 by 12, 1 by 12, do it. It's on time proportionate basis. You ascertain that profit for the 3 years before charging partners interest were as follows. How many years purchase they said? 3 years purchase. Up to what? Up to the date of death. When did the person die? 30th June 2022. That means, do you agree I need the profit from 1st July 2019 to 30th June 2022? Do you agree I need it for these 3 years? That means 2019, should I take half or full? Half. 2020, should I take half or full? Full. 2021, should I take half or full? Full. 2022, should I take half or full? Where is it? No, not there. That's why they gave trial balance. That is why in bold I wrote 2022. So later you will remember that 2022 is here. Is it there 2022? Yes, profit for 2022, 2,34,000. This you will take half. Take your calculator. 2,34,000 divided by 2, 1,17,000. Then this is full, 2,70,000. This is full, 2,83,500. This is half, that means 1,26,000. Is your total profit 7,96,500 divided by 3? Is it 2,65,500? Yes. Is this your average profit? Yes. But can I take this average profit? No. Because this average profit is before interest and before remuneration. Before interest and before remuneration. Now, this is about valuation. We'll discuss that, okay? This is about valuation. For valuation of goodwill, fair remuneration for each of the partner would be 56,250. So, should I subtract 56,250? No. I should subtract 56,250 into 3. Is it 1,68,750? 1,68,750. Is this clear? Next. The capital employed in the business is 5,85,000. Why did they give this capital employed? To calculate interest on capital. How much is interest on capital? Normally it is 12, but for goodwill capital calculation it is 10. So 5,85,000 into 10%, that makes it 58,500. Minus 58,500 also. How much are you getting? Only that much? 38,250. Is it 38,250? Yes. How many years purchase? 3 years purchase. Is it 1,14,750? What is it? Goodwill. Yes. What is it? Goodwill. Now go and search what is the goodwill. 1,14,750. That is the goodwill of the firm. Who is the partner who died? C. C share is what in the question? 3 by 10. Can you see first only? 3 by 10. So into 3 by 10 it becomes 34,425. Are you supposed to give 34,425 to C? Yes. Can you see the gain ratio here in the ratio 1:2? That means who is going to give to whom? A and B will give it to C. A and B will give it to C. What is happening?
This servant.
Which sir? They are talking to someone that side, right? Forget. We have exam in September. Okay, now 114,475 and 22,950. Can you see it is there in the ratio 1:2? Is it in the ratio 1:2? Now A is capital, B is capital to C is capital. Clear? Are you following this? Now look at the capital account. Can you see this fellow is getting 34,425 and from here they are removing 11475 and 22,950. Goodwill done. Clear? They could have done this in current account also, but they have done directly in capital account. Anywhere in the question they have not told it is fixed capital. Clear? Now after that, what do you have? It was agreed between the partners that goodwill was not to be shown as an asset in the firm. Okay, very good. We never show it. We just adjusted in the partner's capital account. Therefore, adjustment for goodwill was to be made in capital account. Clear? The amount due to C's estate was to remain as a loan and it is 12% per annum. Clear? Whatever you are supposed to give to C, let it remain as loan only, but interest rate on that loan will be how much? 12% per annum. Clear? A and B would share profits and losses equally. That is their 1:1 ratio. They gave that only for one reason. That is for what? First to calculate the sacrificing ratio. Other reason we'll see little later. Okay. Depreciation on revised value of asset would be ignored. Thank God. You know what they're telling? You're doing revaluation. No. You'll have to calculate depreciation on that. None of the places it is there in partnership where after evaluation again depreciation. So they told ignore it. That's it. No. What is remaining? You know what is remaining? Only two things. Oh, sorry, three things. First is revaluation. That shouldn't be a problem at all. Second thing is interest on capital we have to give to all the partners. Then you have to calculate profit share of each partner. Now, revaluation. Have they done working note for that? Yes, revaluation. Can you see? Land and building, furniture and fixtures. Whatever profit is there, where should it go? Revaluation profit? Where should it go? It should go to partners current account. Partners current account because they are following Fixed capital, or they're trying to tell us that it is fixed capital. So can you see the revaluation profit sitting over here? Now, can you see in the partner's current account, other than balance carried on, there is only two things now: interest on capital and profit share. Interest on capital should be damn simple. What is the capital? See the capital here, 225. Should we give interest on capital even in the year of death? Yeah, that is in the previous question. They said don't give. Here you have to give it. 225. Take your calculator. 225 into 12% is how much? Is it 27,000? See the interest on capital, 27,000. Next person's capital, 1,12,500 into 12%. How much is that? 13,500. 13,500. Next person, C's capital, 1,35,000 into 12%. How much is that?
16,200.
Wait. How much is that? 16,200. But that is for the full year. But C died in the middle of the year. So divide by 2, 8,100. Can you see 8,100? Yes. Only thing remaining is this profit share now. Till now, nothing was tricky actually. These are all regular things. Nothing was tricky. What is tricky is this profit share. Profit share, are you calculating on the date of death of C, or are you calculating at the end of the year? How do we know that? C died on 30th June. There are death of a partner questions where we do calculation on the date of death. But in this question, are we doing on the date of death or at the end of the year? We are doing at the end of the year. How do we know that? Because trial balance is given till the end of the year. And from the trial balance, how do we know we did not do any calculation? If we had done any calculation in this trial balance, there should have been C's executor. Is there any C's executor in the trial balance? No. And in fact, C's capital account is there still. C's capital account, how can it be there if they have done all the calculations till the date of death? So C's capital account is there. That means we are doing the calculation at the end of the year. When you are doing the calculation at the end of the year, okay, you have to prepare not P&L suspense, you will prepare P&L appropriation, and it should be given to everybody. Not only C, A, B and C, everybody will share the profits. Now, understand this. How much is the profit of 2022? Is it 2,34,000? Yes. Now, look at the calculation here. P&L appropriation is prepared, but it is prepared for two halves. Why two halves? Because first half C is there, second half C is not there. So first what we are doing, dividing the profit into two halves. Then interest on capital we have to give. Both are getting for both halves, but C is getting only for first half because second half C is not there. Now you have to stop the calculation here in the exam. You have to stop the calculation. Only first half. First half you are going to distribute the profit. Clear? To whom you are going to distribute the profit? A, B and C. A, B and C. Go and put C's profit 26,595. A and B will put later. 26,595 distributed to C. Can you see 26,595? Then you will get the balance in C's account. Transfer the balance. Where should you transfer the balance of C? To the executor. Can you see 54,000 is there for C here? That is the opening balance. Now where will this 9180 go? It will go to the capital account 9180. Then finally there is 1,60,245 that is balance to be paid to C. Are you getting this? Did you get it? We cannot close A and B yet because A and B are still there in the second half of the year also. C has already gone in the first half of the year. So first half profit, whatever you computed, go and put it to C. This is the profit. This is the profit, 26,595. Then do the balancing. When you do the balancing, there is a credit balance now. Or still there is a debit balance. Huh? Oh, sorry, there is still a debit balance. Can you see debit side is more 54,000 here? There is a debit balance now. This one will get transferred to what? It will get transferred to C's capital account. Now finally what balance is there in C's capital account? That is to be paid. But did you pay it? Did you pay it? No. When was it supposed to be paid? On 30th June. We have already reached 31st December. Did you pay it? No. That means do you agree on that? There should be interest for 6 months. So your P&L appropriation, if you see, can you see interest on executors amount for 6 months? It has fallen into the other half, 6%. Okay, now whatever balance is remaining, actually interest is 12%, okay. It is 12%. For 6 months, that's why they have made it 6%. Okay, 12% it is interest, but 6 by 12 when they did, it became 6%. So remaining profit is shared between A and B in equal ratio because the new profit sharing ratio is equal. Now this and this is the profit of A and B. This and this is the profit of A and B. It will go to partners current account. It will go to partners current account and these two will just have balance carried down. Capital account also balance carried down. Now if you look at balance sheet, can you see that interest? 9615 on the liability side. Why? Because it is unpaid. Based on accrual concept, we just computed it. It is unpaid. Then if you see C's executor, can you see C's executor 162.45? The amount that we had calculated. This are all balancing figures in the respective accounts. Whatever you are seeing here, see, this is after revaluation, this is after revaluation. Rest of the things straight from the trial balance you are going to put over here. Straight from the trial balance. Now your question, I have a question for you. In the trial balance, everything is there. There is also this profit. Why is it not there in the balance sheet? In the trial balance, can you see one profit 2,34,000? That profit I can't find in the balance sheet. Already it is distributed to partners. That is why it is sitting in their respective current accounts. And it is sitting in C's executor's account. Once the profit is distributed, profit becomes zero. So you will not find it in the trial balance. Is it clear? This is the December 2023 question. What is tricky? Everything. Profit computation is tricky. Because you have to first do for one half, distribute, then get the amount, come and do the interest for the other half. Clear? That is why they asked it for 20 marks. Only 20 marks. Only 20 marks in the exam. June 2023. And trust me, I told you, no, what was the chapter you should never skip is partnership. Because other than June 2023, till now, there is no tricky question asked from partnership. In last 5 years. Not a single time they have asked question which is tricky from partnership. Because they also know that you are planning to skip it. Clear? So they will give easy from partnership and they'll give something tricky from some other chapter. Simple. Yes. That's it guys. June 2023 done. That is it with dissolution. Now you are going to dissolution. Dissolution of partnership. Okay, 33. After we finish partnership, no. Then we'll go to next chapter. I know you are thinking of break, right? Suddenly when I told after I finish partnership, she looked like this. That's why I changed my sentence. Okay, now partnership dissolution, practice question 3. Partnership dissolution, practical question number 3. Yes, Sharon, what happened? All good? What? Okay, now dissolution. There are two types of questions that can come in dissolution. That is just normal dissolution questions and also the piecemeal questions. Now, first thing, Amit, Sumit and Kumar are partners sharing profits and losses in the ratio of 2:1. The partners decided to dissolve the partnership on 31st March 2022 when their balance sheet was as under. Clear? Now, can you see the balance sheet over here? Normal balance sheet. Now, before even we read anything, right, our first task should be to empty the balance sheet. To empty the balance sheet. Now, whatever is there, transfer it to realization account or partners capital account or balance sheet. Sorry, or bank account. Now, can you see land and building here? Land and building. See the realization account, land and building. Transferred. Remember step 1 of dissolution. Transfer all assets and liabilities to realization account at book value. Now, plant and machinery. Transfer to realization account, plant and machinery. Then, furniture. Transfer to realization account, furniture. Then, investment. Transfer to realization account, investment. What about book debts? How much should we transfer? What is the balance of book debts? On the screen. What is the balance of book debts? What? Correct. 60,000. What? 54,000. That is provision. They are separate items. So provision will go to the other side. 60,000 you will see over here. Can you see provision on the other side? 6,000. Debtors are not 54. Debtors are 60. For better presentation, you brought the provision this side and you're showing it. Are you getting this? So now this will be subtracted and then you get 54 over here. Stock 36,000. Stock 36,000. Then bank 13,500. Will you put the bank balance also to realization account? No. Go to bank account. It will be put into bank account. Can you find bank account 13,500 here? Yes. Next, you have Kumar. Kumar's capital is sitting on this side. That means capital has what balance? Debit balance or credit balance? Debit balance. Can you see in the capital account? Kumar is sitting on balance brought down on the debit side. Clear? All the items of asset side completed. Now liability side. Can you see Amit and Sumit? What is their balance? 55,200, 55,200. Where will you find this? In the capital account on the credit side. 55,200, 55,200. Clear? Now, general reserve. What to do with general reserve? Distribute it to partners in what ratio? 2:2:1. So if you see 61,500, it will become 24,600, 24,600 and 12,300. Distributed, reserves are distributed. Then there is Kumar's loan. Kumar is outsider or insider? Outsider or insider? Insider. So transfer that Kumar's loan to Kumar's capital account. Already I have to pay something to Kumar. Loan also you put it there. That means you have to pay a little more to Kumar now. So can you see the loan transferred over here? 15,000. Is it clear? Now after that, loan from D. Is D outsider or insider? D is an outsider. So it should not go to partner's capital account. It will go straight to realization account. Can you see in realization account D's loan? Are you following this? Yes. Next. Enter in the? No, we can't. You know why? Because if I directly enter in the bank account, it is like me telling, before I pay all the outsiders, I'm paying the partner's loan. Partner's loan has to be paid after you pay all your outside liabilities. That is why it is not entered in the bank account. It is entered in the partner's capital account. When you pay outsiders, then you will pay insider. If money is there, that time they will be paid. Is this clear? Now, after that, trade creditors. Where should it go? Realization account. Next, bills payable. Where should it go? Realization account. Do we have outstanding salary? Where should it go? Realization account. Is your balance sheet empty? Is your balance sheet empty? Is your balance sheet empty? Provision already done. Done, see here. Is your balance sheet empty? Yes. Because whatever is there in your balance sheet, either you have transferred it to realization account, or you have transferred it to partner's capital account, or you have transferred it to bank account. So now you have only 3 ledgers. If I ask you any journal entry, none of this should come in your mouth as the answer. Whatever it is only 3 ledgers: realization, partners, capital and bank. That's it. So basically any dissolution question, before even you start reading the adjustment, first you are going to empty the balance sheet. Done. Now whatever you read, you have to pass journal entries. That means you have to give impact based on journal entries. The journal entries will be based on only 3 ledgers: realization, bank and partners capital. Now see one by one. Realization expense amounted to 18,000, out of which 3,000 was borne by Amit. How much is the realization account? Realization expense 18,000. Who is going to bear it? Amit. How much? 3,000. What should be the entry? Realization account debited. How much?
50.
How much? How much is the expense? 18. How much is paid by Amit? 3,000. That means who is paying the remaining? Firm. Firm. So the entry will be realization account debited to Amit's capital to bank. So if you see over here, realization account debited to bank 15,000. Realization account debited to Amit 3,000. Can you see this? And you should find it in Amit's capital account also. Can you see 3,000 in Amit's capital account? And you should find the 15,000 in bank also. Bank, many things are there. One of them is this 15,000. Clear? Many things are there which will come from realization. One of them is 15,000. But did you get it? Whatever entry anymore will be between these three ledgers. Now, a creditor agreed to take over furniture of book value 12,000 at 10,800. What should be the entry? Creditor told, I will take the furniture. What should be the entry? Yes, good morning. What should be the entry? Creditor account debited to? Who is creditor? Who is creditor? No entry is the answer. No entry. Where creditor? I told you only three ledgers. Realization, partner's capital, bank. Where is the entry? No need of entry. Why? Because what is creditor taking? Furniture. Where is creditor sitting? Realization account. Where is furniture sitting? Realization account. If creditor is taking something, entry will be realization account debited to realization account. If you want, you can pass an entry. I don't think ICA has passed the entry. Okay. Because it doesn't make sense. Can you see ICA passing that entry for 10,800 anywhere? No. But I'm sure somewhere else I have seen ICA's passed entry also. Okay for that. ICA are doing ICA things. Okay. They just want to show all approaches. That's all. Now, did you understand why no entry? Where is furniture? Realization account. Where is creditor? Realization account. Creditor is taking furniture. No effect. Clear? If the furniture was taken by partner, then effect. If furniture is sold, then effect. Only three ledgers are there. Is this clear? Simple. When it is dissolution, which is not piecemeal, no. It is the easiest. I'm telling you, in entire partnership. Even the intro question is not as easy as this. Remember, we took some intro question, no? Where we had to correct the profit and all that. Even that is not as easy as this. Here, empty the balance sheet. Only three ledgers. Whatever happens, it should go into these three ledgers only. Now, the rest of the creditors were paid off at a discount of 6.25%. Tell me, how much is the creditor here? 30,000. How much is the creditor? 30,000. Now, out of 30,000, how much did we pay? 10,800. 12,000 was the value of the furniture, but he took it at what value? You drew your bike and went straight into the showroom and told, I want to exchange this bike. In your books, this bike is showing 50,000. Do you think showroom value also will adjust only 50,000? He might tell 10,000 for this. Possible. So what got adjusted here with the creditor? 10,800 got adjusted with the creditor. How much is remaining now? 19,200. How much discount are we giving him? 6.25%. Minus 6.25%. What are you getting? 18,000 rupees should I pay? Yes. What is the entry? What is the entry? What is the entry? When you don't know the answer, and it is not bank, it is think. When I'm telling it is paid, how can bank come first? Only three ledgers. Again, good morning. Only three ledgers. You have to pay. Realization account debited to bank. Clear? Realization account debited to bank account. Creditors 18,000. Can you see over here? And in the bank, you should find 18,000. Many amounts are there. So in the bracket, we have to search for that. 18,000. Okay. Other assets realized as follows. Furniture remaining taken over by Kumar at 90% of the book value. How much is the furniture? 25,500. But out of the 25,500 ka furniture, did you give something to someone? What did you give? 12,000 to creditor. That means you are left with only 13,500. Who is going to take this furniture? It is taken by Kumar. But is he ready to adjust full value? No, only 90%. 13,500 into 90%. How much? 12,150. Tell me what should be the entry. Kumar is taking this furniture. What should be the entry? Kumar, yes. Kumar's capital account debited to? No furniture. Realization. Kumar's capital account debited 12,150 to realization account. Can you see 12,150? Are you following this? Only three ledgers. Only three ledgers. You don't have to think outside this boundary of three. Any entry will be between these three only. Clear? Now, after that, stock 120% of book value. How much is stock here? 120% of 36,000 is how much? 43,200. Are we selling or is partner taking? Are we selling or is partner taking? Partner is taking. Partner is giving how much? I mean, sorry, what taking? We are selling. We are selling for 43,200. Entry. Entry for 43,200. What is going? Stop. What is the entry? Bank account debited to realization account. Bank account debited to realization account. Now assets they have given total, okay. Here they have given total, but in the realization account they have given one by one. See over here. Stock realized 43,200. Clear? There only total is there. Now, next. 12,000 of debts proved bad. What should be the entry? 12,000 of debts proved bad. That means you are not getting anything. If you are not getting anything, what are you going to bother about? Nothing. But remaining were fully realized. Now you are thinking, sir, wait. Earlier and all, bad debt we used to pass entry rate. Now why we are not passing entry, sir? I'll tell you the reason. This is my realization account. Okay, I have one debtor of 10 rupees. Transfer this to realization account. Tell me what is the entry. I have one debtor of 10 rupees. I want to put it to realization account. Realization account debited to debtors. Correct? This debtor pays me money. Then I got 10 rupees. No profit, no loss. This debtor paid me 12 rupees. Then I got profit. This debtor does not pay at all. Is there any entry to pass? Automatically it will be loss only. If he doesn't pay, it's loss. Then directly by partner's capital account. Are you getting this? So, for not paying, you don't have to pass an entry. Automatically it is reflected in the realization account. Now, remaining were fully realized. How much is the book debt? How much is book debt? 60, not 54, 60. Out of 60, how much is bad debt? 12. How much will remain? 48. Are you getting fully 48? Yes. 48 you are getting. What is the entry? 48,000 received from debtors. Bank account debited to realization account. Can you see in realization here 48,000 debtors? And the total is anyways added to bank. When we get the total, we'll add it to bank. Clear? Next. Land and building realized 1,65,000. What should be the entry? Land and building, bank account debited to realization account. Can you see in realization 1,65,000? This is the total. 2,56,200 we have received. Can you see 256,200 in the bank account also? Can you find this? Yes. That's it. Now, investment taken over by Amit at 15% discount. How much is the investment in the question? 15,000. It is taken at what? 15,000 minus 15%. 12,000. Taken by whom? Amit. Entry. Amit's capital account debited to realization account. Amit's capital account debited to realization account. Can you see 12,750 here? You should find it in the realization account also. Can you see 12,750 here? Are you getting it? See, partner takes asset, partner's balance has to reduce. Partner takes liability, partner's balance has to increase. Clear? Next. For half of his loan, D accepted plant and machinery and 7,500 cash. The remaining amount was paid at 10% discount. Now, how much is D's loan? How much is D's loan? 1,20,000. Correct? Now, 1,20,000 is D's loan. How much is half of the loan? 60,000. That means what is the other half? 60,000. So now understand this. For half of his loan, he accepted plant and machinery. D took plant and machinery. What should be the entry? D's loan is there. He took plant and machinery. What should be the entry? No entry. D's loan is liability. Liability account debited to asset. But both liability and asset are sitting in realization. So realization to realization. But we are ready to pay him 7,500 cash. For that, what should be the entry? Realization to bank. So for this half, we are giving 7,500 cash. Other half, we are paying at a discount of 10%. Minus 10%. Are you getting 54,000? Total amount, what am I paying? 61,500. What is the entry? Realization account debited to bank account. Go to your realization account. Can you find 61,500 here? And can you find that 61,500 in the bank account also? Yes, but it's given separately. Because one is 7,500, one is 54,000. Can you find 61,500? Yes, no. Yes. Next. Bills payable were due on an average basis of 1 month after 31st of March 2022, but they were paid immediately at 6% per annum. Immediately at 6% discount per annum. How much is bills payable here? Bills payable. Can you find bills payable? 12,000. 12,000 minus how much discount they are getting? 12,000 into 6% into 1 divided by 12. Why? Whenever today only, no, yesterday only we had discussed renewal or retirement of bill. If it is retired early, we'll get discount, which is called as rebate. Now, can you see here? Average basis, it was 1 month after 31st of March. When were we supposed to pay? After 31st of March. When are we paying? 1 month early. So now what happens? 12,000 into 6% divided by 12, 60 rupees. So this is, can I take it as 11,940 rupees I'm supposed to pay? Entry. Entry. Realization account debited to bank account. Realization account 11,940 debited to bank account 11,940. Actually question got over, no, over here. But one hidden thing is there. You know what is that hidden thing? Loan from D is paid. Trade creditor is paid. Bills payable is paid. Outstanding salary not paid. They didn't tell anything. Any liability pending, if untold, that means it is paid. Because without paying that, you cannot go and tell later I'm distributing the money to partners. Okay, so this 7,500 also I want to pay. Tell me the entry. Realization account debited to bank account. Realization account debited to bank account. Can you find 7,500 in realization account? 7,500. To bank account. Can you find 7,500? Only pending amount. Can you see here 7,500? Done. Now what will you do? Only thing you will do is close the realization account. Can you see everything is discussed in the realization account? Close the realization account. Transfer the profit to partners. In this question it is profit. So just transfer the profit to partners 9264, 9264 and 4632. Clear? After that you have only two ledgers remaining. What are the two ledgers? Partners capital account and bank account. Now there will be some money in the bank. No. This money which is there in the bank, it should be distributed in what ratio? There is some money remaining in the bank now. Two ledgers are there, partners capital account and bank account. Money remaining in the bank should be distributed in what ratio? Old ratio. No. Not old ratio. Is it new ratio? No, there is no new ratio. Is it sacrificing ratio? There is no sacrificing. Is it gain ratio? No, no. Gain ratio is not there. Is it capital ratio? No, no. There is no ratio only. Adde, there is no ratio. Profit, it is not profit to distribute here. Money is there in the bank account. You have to check the partner's capital. Does he have credit balance? Give it to him. Does he have debit balance? Take it from him. Now can you see Amit's capital account? There is credit balance. Can you see credit side is more over here? That's why, can you see one entry here to bank? This is balancing here. Yes, yes. Then Sumit's, can you see credit side there is more items? So this will be the balancing figure. But Kumar, it's not the case. Kumar debit side is more. Because Kumar started only with debit balance. Sir, wait. Kumar started with debit balance. That means Kumar is insolvent. No, unless they tell you nobody is insolvent. Kumar started with debit balance means he has to pay money. Can you see 12,618? All this is transferred to bank account. When you transfer this, automatically bank will close. Okay. And tally. It has to tally. You know why it has to tally? It has to tally. You know why? Because first time in your first PUC, you passed one journal entry. Cash account debited to capital account. You didn't pass it. I'm telling about others. Okay. I'm talking about him. Okay. You're also a science student? Okay. You passed, right? In 11th standard. Cash account debited to capital account. Yes. After that you passed. First journal entry. Cash account debited to capital account. After that you passed credit purchase, cash purchase, credit sale, cash sale, salary, wages, electricity, discount allowed, discount credited, and so many other things, drawings and so many things, correct? Every time when you pass this entry, debit and credit, was it equal? Yes. Now what did I do? I removed one by one item from the balance sheet. When I removing also was based on debit and credit only. Finally, when we removed every ledger, only three ledgers were there. Realization, partners capital account and balance sheet. Bank account. Realization gone. We have only two ledgers, bank account and partners capital. These two should have opposite balance. These should have opposite balance because we follow dual aspect concept. Now, if I empty one, other one automatically has to be empty, no? Can you have in your balance sheet only bank account remaining? That means you have not followed dual aspect concept. That means your balance sheet is not tallying. Are you getting it? So ultimately at the end, bank will automatically become 0. Is this clear, guys? Yes. We have one more question from dissolution. Practice question number 2. Practice question number 2. Yes, Sharan. Done. Thin, short and fat. Full body shaming. Okay, Charan, tell me who are you in this? Huh? None of the below. Thin, short and fat. 3 partners are there. Okay, we're in partnership sharing profits and loss in the ratio of 2:1. Their balance sheet is as follows. Okay. See here. What did they ask you to prepare? Realization account, partners current account, partners capital account showing the firm's books. But bank account by default will be required as a working note at least. Now, tell me one thing over here. Should I start reading from here what has happened? No, first what I should do? Empty the balance sheet. Empty the balance sheet. Premises, fixtures, plant, stock, debtors. All should go to realization account. Premises, fixtures, plant, stock, debtors. All transferred. Now, capital account, 3 things. Where should it go? Capital account. Balance brought down. Can you see the balance brought down of capitals? Next, current account, 2 things should go to current account. And that one ulta thing should go to debit side. Yes. Can you see 14,500 here? Yes. Creditors. Where should creditors go? 84,650. Clear? Oh, sorry. What are we talking? Creditors over here, 84,650. Clear? Because they paid that amount. That's why number is matching. Like in last question, if they give furniture and all, number would not match. 84,650. What about bank OD? Bank OD. Will it be here? No. It will be there in the bank account as a negative balance. Can you see? By balance brought down. 44,330. Clear? By balance brought down. Done? Balance sheet Kali? Done? Now you have to read the question. How many ledgers you have? Realization account? Bank account? Partners capital. Whatever happens should happen between these 3 only? Okay. Now, see this. Pin decided to retire. Oh, sir. Oh. We thought it was dissolution question. Now it's looking like retirement question. Now, Pin decided to retire on 30th September 2022. And Fat appears to be short of private assets. And Short decides that he does not wish to take over Thin share of partnership. So, all 3 partners decided to dissolve the partnership with effect from 30th September 2022. Full bakwas. 3 people, they did whatever they did. Let them do, no problem. Finally, all 3 decided to dissolve. Is this clear? Now, it then transpires that Fat has no private assets whatsoever. Fat has no assets whatsoever. That means who is insolvent in this question? Fat. Now, premises sold for 60,000. Premises is sold for 60,000 and planned for 1,07,500. What should be the entry? Premises sold for 60 and planned for 1,07,500. What should be the entry? Bank account debited to realization account. And fixtures also realized 20,000. Okay. Stock is also acquired by another firm at 5% less. And debtors also realized 45,900. For all of this entries, bank account debited to realization account. Now, if you notice this, bank account debited to realization account, total amount they have put, and in realization account, 1 by 1 items are there. All the ones which we discussed. Only stock is not directly same amount. Stock will be after taking the discount percentage, whatever is quoted. Is this clear? Yes. After that, realization expenses amounted to 4,500. What should be the entry? What should be the entry? Realization account debited to bank account. Realization account debited to bank account 4,500 and in bank account 4,500. Clear? After that, bank overdraft is discharged and creditor also paid in full. Creditor paid in full. What should be the entry? No entry. No, we have to pay. Realization account debited to bank account. Why no entry? We are paying. No entry for bank OD. Because bank OD we started the ledger only with a negative balance. No, automatically it will be adjusted. You don't have to do anything there. Then that's it. Is there any liability which is unpaid? Bank OD done, creditors done. Clear? Now what? One partner is insolvent, so you have to be a little careful. Now understand this. Here, fact. I'll tell you. Fact, yeah. That's what he asked. No, who is insolvent? Full Brahmanda she was searching for. Who is insolvent? You told? Okay, now, done. Do we have profit or loss? Loss. Can you see loss is shared between partners? Yes, loss is shared between partners. In what ratio? Because many questions I told no ratio. Now, first you are thinking no ratio. Loss is shared in profit sharing ratio only. What new ratio I'll find for that? Because many questions I gave this trick question, you are thinking this is also trick. No. Profit sharing ratio. And profit sharing ratio is how much? 2:2:1. Clear? Can you see this loss distributed in the ratio of 2:2:1? Clear? And this loss will be entering into partner's current account. Whenever you see a loss, what will you do immediately? Whenever there is loss, what should you do immediately? Your hand should automatically move to the other side. Why? Solvent partners will bring money. When there is realization loss, solvent partners will bring money. So, who are solvent here? Only thin and short. Fat is insolvent. So, 14,216 will be brought by these two partners. Can you see over here, buy bank in the capital account?
Yes.
Money bringing in will fall into capital account. That's why it's not in current account. Clear? Automatic. Can you see this 14,216? Done. Now, what are you going to do? What are you going to do? Other than playing with your hair, what are you going to do? Yes. What are you going to do? You are going to immediately close everything. Okay. But whom you are going to close first? Fat. Fat, whatever balance is there. Can you see? The balance whichever is there in Fat's account, that is transferred to capital account. See, can you see by capital, this 21,608 comes over here. Clear? Now use your calculator and tell me how much is there balance in Fat's capital account? 1,608. 20,000 this side, 21,608 this side. That means Fat has to give us money or we have to give Fat money. Fat has to give us money or we have to give money to Fat. We have to give money to Fat. How much money should we give to Fat? 1,608. Are you sure? Yes, but actually Fat has to give us money. Credit balance is 20,000. Debit balance is 21,608. How will I go and give? Someone has taken loan from me. I will go to his house, wash his feet and give money to his hand and come back. Correct? Fat has to give us money. Are you getting this? Now 1,608. Fat, does he have money? No. Fat is insolvent. And guess the bouncer over here. Fat's estate also nothing is there. Bhagwan Bharosa. Nothing is there in Fat's account. So now what will happen? Everything will be borne by thin and short. Thin and short. In what ratio? Capital ratio. What is capital ratio? 8:5. What is capital ratio? 8:5. Can you see it is borne by the other partners? 990 and 618 in the ratio of 8:5. And we are telling Tata bye-bye to Fat. 1,608. Don't show your face again. Because of you, we had to pay money. Clear? After that, what to do? Fat is gone. Thin and short, both are there. Okay? Thin and short, both are there. At least that you are thinking, no? That was the intention. If I would tell thin and short, then they will be like, okay, one more thing is telling from afternoon. This also one more. Okay. Now, thin, when I made thin and short, they're like, hey, no, that doesn't match. Okay, now thin and short are there. Both are solvent. Only job you have to do is check if there is debit balance or credit balance in their capital account. Then pay the money. Can you see? 2 thins capital account, 2 shorts capital account. 2 thins capital account, 2 shorts capital account. This is for the realization loss. And finally, this entire amount is shared by thin and short. Not in any ratio. Good morning again. Not in any ratio. You have to check the capital account. Balancing figure is going to be put over here. Is this clear? Done. Done. What done, sir? Even piecemeal is there, no, sir? Yeah. What on earth is piecemeal now? What on earth is piecemeal? Today afternoon you went to PG, right? For food, did you go to PG? Yes or no? Yes. What did they make? Chicken. Along with chicken, what? Roti. Roti was round. Okay, at least you look around. Okay. Okay. Roti was there, correct? Full roti, did you put into your mouth at once and eat it? Huh? Oh, such a small one. Huh? Okay. Imagine little bigger roti. Okay. Can you put that full roti into your mouth and eat it? No, right? How do you eat the roti?
Piece by piece.
Piece by piece. That is why the name piecemeal distribution. Clear? That is why the rule or name came piecemeal distribution. Now this is our room which is getting dissolved. Is it possible for me to sell all the asset at once? No. One person will enter. He likes the AC. One more person enters. He likes the benches. One more person enters. He likes the TV. Correct? So they will take the assets part by part. That means in dissolution, assets are sold part by part. When assets are sold part by part, money comes in also part by part. Now that money which comes part by part, what will I do with that money? First I will pay outsiders. Then I will pay insiders. Then whatever, if ever remains, will go to partners. How to distribute the money to partners? Not in any ratio. Not in any ratio. That is why they have prescribed 2 methods. One is maximum loss method. Other one is higher relative capital method. Maximum loss method and higher relative capital method. Now, maximum loss method. Our first question, I think it is, higher relative. We'll do the second one. Maximum loss. We'll discuss maximum loss and then come and do the other method. Is it clear, guys? Now, maximum loss method is created by one guy who is completely negative person. Completely negative person. Each installment is considered as last installment. Whenever money is coming, after this we won't get any money. Whenever money comes again, he's like, after this we won't get any money. After this, if we don't get any money, do you agree that partners will have a loss? If partners have a loss, distribute the maximum loss to partners in profit sharing ratio. Then maximum loss is equal to amount payable to partners, amount available, minus amount available. In case of deficit of any partner, always follow Ghana versus Murray. That is it with maximum loss method. You have to understand it inside the question itself. Okay, maximum loss, how it works. Now see this question over here. Okay, have a look at this question, which is question number 7 from your illustrations. Question number 7. Where is it? Oh, here it is. Question number 7. Page number 2. Question number 7 is in page number 2. Next. Okay, now listen. Piecemeal distribution. In piecemeal distribution, see the end of the question. You have to just prepare, show at each stage how cash received should be distributed between partners. Piecemeal distribution is all about preparing a statement showing distribution. That's it. Are you preparing ledger? No. Are you preparing journal entries? No. Are you preparing any balance sheet? No. You are just preparing a statement showing how money is distributed. Now here, always look at the existing balance sheet. Whom do I have to give money? See the balance sheet. Whom do I have to give money? Right in front of your face. Whom do I have to give the money? I have to give creditors. I have to give A's loan. Then I have to pay A, B, C. In this, who is outsider, who is insider? Creditor is outsider, then everybody is insider. When you are distributing the money, no, first money should go to outsider. Then the money should go to insider's loan. Then the money should go to insiders. Clear? Can you see the statement? Statement showing distribution. Wait, where is it? Here it is. Statement showing distribution. Okay. Can you see that you have to pay creditors, partners loan and partners capital. They have done it. Partners capital separately. Okay. And then they have done everything together. Now see the question here as we go further. Okay. Like this, we got money. First installment, second installment, third installment, fourth installment, fifth installment. Do you see something abnormal in the fifth installment? What is that? Yeah, reference. Yes, that's exactly right. It's not one, it's a reference. Correct. Now, what is the reference? That one should have also have been written over here, which they didn't do. Now, what does it say? Expenses of realization were expected to be 500. That means, what did we do? Whenever we are getting money, realization expenses are there. I am keeping 500 in the side. Then, after that, but ultimately amounted to 400. You kept 500 rupees to go for movie and only 400 rupees you spent at the movie. What will you do with the 100 rupees? You will put it back to what? 100 rupees if you get popcorn. No, even I'll come for that movie. Tell me, where is that 100 rupees popcorn? I also want to go. Because movie price will be less, but popcorn price will be more. Huh? But not in the multiplex, right? A single screen here also I think it is 50 rupees only. But multiplex, the popcorn price is crazy. But do you know the reason behind it? Do you know the reason behind it? No. PVR will not make much money from displaying a movie. There they get very small percentage for displaying the movie. Everything goes to distributor. If they have to make money, popcorn, Pepsi, that is where they make money. Water bottle, yes, water bottle. That is why in the interval, half of the people will be thinking that we should not eat popcorn. But as soon as interval starts, first ad is popcorn. Popcorn will come. Then the Coke ad will come. When you see that, out of the half who thought should not go, at least 50% will get up and go to buy popcorn. That is all the mindset. If you eat popcorn 3 times when you go to movie back to back, no. After that, every time you will eat. I'm telling you, it's a mindset. If you eat popcorn 3 times back to back 3 movies when you go, if you eat popcorn, after that, every time you will eat. You know why? Because it has become a practice that movie means popcorn should be there. At least 1% in the group will take the topic of popcorn over. All will go then. Let me guess. You being you will stuff biscuit and other chocolates inside your shirt here and you'll go for the movie, and when they're checking, you'll stand like this. When they're checking like this, you'll do like this. So all biscuit and chocolate will be stored here. Then from after going inside, you'll take from here and eat. Something like that, 100% you would have done. Based on your past life story. Or you being you, only other thing that you could have done is inside the popcorn fellow is your friend who is working part-time over there. That fellow will give free popcorn to you. Somebody, your friend will be there working part-time in PVR. Okay guys. Shh. What is this 1 year? Reference. Clear? I kept 500 rupees aside and I spent only 400 rupees. That means 100 rupees is added to the last installment. And that is why it is showing 20,100. And that is the reference point that they have given over there. Now, first installment. Understand this. First installment. Installment number 1. See, can you see installment number 1? How much did you get in the first installment? 1,000. How much cash did you already have? 500. So do you agree right now you have 1,500 with you? Yes. But out of that 1,500, 500 you are keeping aside for realization expense. So how much are you having remaining? 1000. Who will you give this 1000 to? Creditor, outsider. So can you see that 1000 is fully put into creditor? Creditor 1000. Are you getting it? Now, see, realization means not realization expense. Realization means what is the amount realized? Amount realized is 1000. Whom did you give? Fully to creditor. Whom did you give? Fully to creditor. Clear? Now, next what did you get? 3000 you got. Whom will you give it to? There is A's loan. You will give it to A's loan, but first you will pay the remaining amount to the partner. Remaining amount to creditor. So now next time you got 3000, 1000 to creditor and 2000 to A's loan. Clear? Next time you got 3900. Sir, wait. Like this randomly we are distributing. We are not even talking about maximum loss. Maximum loss or whichever method becomes active only when you start paying partner. When you are paying outsider and all, no method. Can you tell the outsider, wait, I am doing maximum loss method. You come tomorrow. He will kick you to and take extra money and go away. Are you getting it? So all the methods become active only when you are paying partner. Next, third installment, how much did you get? 3900. How much is still pending in that loan? Still 3000 is there. So can you see 3900? 3000 is paid towards that partner's loan. Do you have 900 rupees remaining? Yes. From here onwards, the maximum loss method starts. From here onwards, maximum loss method starts. Now, can you see over here? Distribution of 900. Can you show they have shown? Distribution of 900. Now, every time when you are distributing, right? Check the methodology. Each installment should be considered as last installment. How much is there in our installment right now? 900. We are considering that this is the last 900 our partnership firm is going to see. After this, there is no money. If at all that is the case, do you agree 15, 18 and 19, the 42,000 which is there, out of that, only 900 we are going to receive? Only 900. That means, do you agree 41,100 is a loss? 41,100 is a loss. This 41,100 should be distributed to partners in their profit sharing ratio, which is 2:2:1. When you distribute that, after removing the loss, if there is any capital balance, that should be given. Did you understand? Distribute the loss. After removing the loss, if there is any capital balance, that should be given. Now, from 15,000 remove, 18,000 remove, 9,000 remove. After removing that, you will get negative, positive, negative. Correct? If any partner is going into negative, automatically who two people should come into your life? Garner versus Murray. So this negative has to be borne in capital ratio. Can you see their capital ratio is 2:1? So when you distribute this negative in the capital ratio, that time this negative is gone, and here we have 1,560 and 960. If you remove 600 and 300, can you see 600 and 300? 600 and 300 totals up to what? 600 and 300. 600 and 300 totals up to 900, and 900 is the amount that we have. 900 is the amount that we have. Is it clear? Battery is not only in power saving mode, it is switched off. Power saving mode switched off. Alarm also won't ring now. Clear? Now, after that, next time, how much did you get? 6,000 you got. Same procedure you have to follow. After that, see the new balance now. 41,100. 15, 17,400 and 8,700. How did I get this money? Whatever I had to give earlier, minus what was the amount paid? Nothing to A. 18,000. 600 to B. 9,000. 300 to C. That time automatically, can you see the new balance is over here? Clear? Now, how much money do you have? 6,000. If you have 6,000, do you agree 35,100 is loss? Maximum loss. Again, same procedure. Distribute the loss. 2:2:1. Distribute the loss. When you distribute the loss in 2:2:1, you will get some resultant figure. Okay, that means after removing the loss, whatever is there in partner's balance, that amount we should pay. Can you see all three are sitting on positive here? If it is positive, this should total up to 6,000, and that is how you are paying that 6,000. Are you getting this? Next, third, last installment, how much money I got? 20,100. Now, understand here, how much I was supposed to pay to the partner? 15,000. How much did I pay? 960. That means what is the balance? 14,040. How much was I supposed to pay? 17,400. How much did I pay? 3360. What is the balance? 14,040. How much was I supposed to pay? 8,700. How much did I pay? 1,680. How much is the balance? 7,020. Clear? When you have this balance, you got some money. How much money you got? 20,100. Out of this, if I remove 20,100, how much is the loss now? 15,000 is loss. Distribute the loss again in the ratio of the profits 2:2:1. Is it clear? 2:2:1. That time you will get some balance. After removing the loss, if there is some balance remaining, that loss, that amount has to be paid to the partner. If you see, the balance is 8040, 8040, 8040. This is how you are going to distribute. Sorry, 4020. This is how you are going to distribute. After distributing, still there is some balance remaining in the partner's accounts. That is going to be loss. That is loss because one more installment did not come. Okay, this is your maximum loss method. Now, what about higher relative capital method? Higher relative capital method. Whoever has higher, you have not studied only piecemeal? Huh? Everyone looks so blank in piecemeal. You have to,
Peaceful, sir.
what?
Nothing is peaceful.
Tomorrow when you are feeling sad, no, you think of this joke. Higher relative capital method. Now, higher relative capital method means, listen, shh. Higher relative capital method means whichever capital has higher, whichever partner has higher capital, that partner has to be paid first. Okay, sir, very simple method. It looks like question number 8. Question number 8. Okay, question number, yeah. Question number 8. Illustration 8, yes. What does higher relative capital mean? Whoever has highest capital, they have to be paid first. Okay. So in ABC, who will be paid first? A. That is not the method. If the method was that simple, it is not the method. No. In ABC, who will be paid first? Huh? We should see the ratios. Higher relative capital doesn't mean that just amount you are going to see and pay. It has to be in, you should see the ratios. Now understand this. Can you see step 1? Step 1, higher relative capital method. What is step 1? Read. Divide the partner's capital by PSR. So now if you see this, capital is 76, 48 and 36. You are going to divide it by PSR. Divide means not in the ratio and all. Just write 2 to 1 below that. Divide by 2, you will get 38,000. Divide by 2, you are getting 24,000. Divide by 1, you are getting 36,000. Clear? This is the resultant figure. Now see step 2. Keeping the capital of the partner who has least resultant figure as base, calculate the required capital. Who has the least resultant figure in this? B has the least resultant figure. So you will keep B's capital as base. What is B's capital? 48,000. If you keep B's capital as base, 48,000 is for 2 by 5th share. How much is 1? How much should be the capital now? Calculator, it works on calculator. 48,000 is for 2/5 share. How much should be the capital? 1,20,000. 1,20,000. Now this 1,20,000 will be distributed in the profit sharing ratio of 2:2:1. Now 48, 48 and 24. This much capital is required. How much capital is there in A? A, how much capital is there? 76,000. How much is required? 48,000. Remaining everything is extra. 28,000 is extra, excess capital. That is called as higher capital. We'll wait and see. Here B, how much is required? 48. How much is there? 48. Nil. How much we require for C? 24. How much is there? 36. That means extra capital is 12. That means, do you agree? If at all I get 40,000. If I get 40,000, first I'll give it to A and C. First I'll give it to A and C because they have higher capital. But what if I get 5,000? Now whom to give? Two people cannot be high relative capital. It is in like WWE. Have you watched last man standing match? The last person standing will be considered as higher relative capital. Again you will repeat the methods. Between these two, what is the ratio? 2:1. Divide 28 divided by 2, you will get 14,000. 12,000 divided by 1, you will get 12,000. Can you see 14 and 12 is there? 14 and 12. By the way, guys, I'm just giving you a disclaimer, okay? After 2024 June, I don't think they asked dissolution question. After 2024 June, that was first attempt of new scheme, they asked dissolution, piecemeal distribution. After that, they didn't ask dissolution question. You know what that means? You know what that means? There is a high chance of them asking. It's due for a very long time. Accrual concept even they'll follow. It's due. Okay, anytime they can just put it in the exam. Yes, so you get 14,000 and 12,000. You have to keep whoever has least resultant figure. Who has least resultant figure here? This person. Keep his excess capital as the base and calculate. So 12,000 is for 1/3 share. How much is 1? That makes it 36,000. Distribute that 36,000 in the ratio of 2:1. That time you'll get 24 here and 12 here. How much excess capital this fellow had? 28. And how much is there here? 24. That means it makes it 4,000. How much excess capital is there? 12,000. How much is there here? 12,000. That means nothing extra. Now whatever happens, first when money comes, you will pay 4,000 to A. Can you see? This is A's higher relative capital. First you will pay 4,000 to A. After that you will pay A and C. You are supposed to pay A and C. But out of this A is 28,000. 4,000 is paid first. Can you see the distribution? First you will pay to A. Then you will pay to A and C in the ratio of 2:1. After that whatever comes. After that whatever comes. It will be distributed to everybody in the profit sharing ratio. Are you getting this? So now if you see the distribution sheet, right? If you see the distribution sheet, can you see? Amount is just distributed in the ratio of 2:2:1. Why? Because higher relative capital is paid off. Here, can you see amount is not distributed in the ratio of 2:2:1? Because first you are paying A and you are paying C. Can you see B's amount is least over here? Are you following this? This is how higher relative capital method works. In maximum loss method, no, all the calculation happens inside the solution. Okay, higher relative capital, first you do the calculation and keep. Then you will know who has to be paid. Then you just go on distributing. It's like fill in the blanks. Clear? Both these methods are not asked for a very long time. That is 3 attempts. They have not asked for 3 attempts. After June 2024, they didn't ask. That means due entry. I'm passing the due entry. September exam, they might pass the receipt entry. Clear? You tell me after the exam whether it is still due or it is received. Okay? Is this clear? After studying everything of partnership, it is really not worth it to skip dissolution. Only thing is what has happened, why majority of the people have skipped dissolution is, by the time they finish unit 1, goodwill, after that goodwill, admission, retirement, death, then they lost the battery of partnership. Then they're like, we'll see some new chapter now. That is why dissolution always remain pending. But actually it is not worth it to skip dissolution. There are other things which are tricky, I agree. But dissolution is the most simple one in partnership. In fact, piecemeal is even more simple. You have not studied it, that's why you are looking lost. Piecemeal is even more simple. It is basically filling the blanks. You don't even have to think of debit credit here. Money came, pay outsider. Money came, pay insider. Then pay all the partners. Which method? Maximum loss or higher relative. Is it clear? Yes, that's it with our partnership. Finally, we have finished the partnership chapter. Next, we'll go into something you want to go into. Company accounts. We'll do NPO. We'll do NPO. Because NPO also I feel many people don't like it. So, it is very similar to final accounts. Break will take, but you have to first decide what are you coming back into. NPO. Okay, we'll take majority. How many company accounts? Okay, how many NPO? NPO. Listen, NPO has 1, 2, 3, 4. Only 4 questions. And listen. And other than these 4 questions, even the past 4 attempts questions, I am not looking at NPO. Because these 4 will cover those 4 also. And these 4 will cover whatever is there. If you have studied NPO, no, these 4 actually copy paste of study material questions. Clear? Yes. After the NPO, we'll go to company accounts. Then we'll go to incomplete accounts.
Interest will be high.
So we'll do NPO. Yes, guys. Next topic that we are going to discuss is NPO. What is this NPO? Not for profit organization. Charan, you can't get into this because there is no profit in this. Not, charity, yeah. You are not going to get into not for profit organization. The other party, whoever is supporting you, they are NPO. Correct, no? Yes, not for profit organization. You can see. Okay, is it trust, guys? Is it trust? No. Trust we are not covering here. Trust has different methodology of accounting itself. These are basically clubs, sports association. Okay. Now if you go in Bangalore or any your hometown also, you will see in every area there will be one local friends club.
Yeah.
One area's name and that friends club. That is an NPO. That's a not for profit organization. That friends club sometimes in the year they will conduct some blood donation camp. They'll conduct some blood donation camp or some random distribution of sweets and all for students. Okay, that is not for profit organization. Okay, here we have examples like Rotary Club, Lions Club, Sports Club, Alumni Club. Every college will have an alumni association. That is also not for profit. All the alumni would have been asked to donate some money. Okay, with that they'll conduct some activities and all. Okay, educational institutions and hospitals are also not for profit organizations. Now don't think of your college and think that, oh, that was not for profit organization. But they collected so much fees from us. Purely profit, but it is not for profit. Purely profit, but not for profit. Imagine if it is really not for profit, why do they have to charge fines? Why do they have to charge fines? No, to construct one more building. Yes, for the growth of the educational institution. Yes, and all the politicians usually, they feel that to make their black into white, educational institutions are very good. What is this black into white? You will understand when you go to Inter. Let's not worry about it. Now only you got it. Tax. What is tax? We don't know. Only Nirmal auntie knows that. Yes, now accounting. When we are in NPO, right, to do the accounting, you have 3 things. One is called as receipt and payment account. Other one is called as income and expenditure account. Third one is called as balance sheet. NPO or PO. You always have to have the position statement. Balance sheet will be there. Now, receipt and payment account is nothing but a cash book. Receipt and payment account is nothing but cash book. Clear? Now, after that, income and expenditure account is like P&L. Sir, if it is like P&L, why can't we call it P&L? Because if I call it P&L, then the full form will become profit and loss account. We are talking about NPO. So therefore, it's called as income and expenditure account. And in income and expenditure account, we are not going to calculate profit. We are going to calculate surplus. We are not going to calculate loss. We are going to maintain the word deficit. Then balance sheet. In balance sheet, we don't have capital. We have capital fund. Capital means amount invested by owner. There are no owners here. So capital fund means amount accumulated. Amount accumulated for the purpose of the NPO. Clear? Now, we already have receipt and payment account. Why do we need income and expenditure account? You are thinking, no. This is the answer. Not thinking, okay. Yes. Receipt and payment account when we have, what is the need for income and expenditure? There is a huge difference, not small. Huge difference between receipt and payment and income and expenditure. Receipt and payment is cash book. Income and expenditure is like P&L. In cash book, we don't follow accrual concept. In P&L, we follow accrual concept. Record transactions only related to current year. Cash book, what? No accrual concept. Only when you receive money, will record. Only when you pay money, will record. And in cash book, all receipts and payments to be recorded. 10 years ago, the amount if you receive also, you will show it in cash book. But 10 years ago amount if you receive, you will not show it in profit and loss account. Are you getting this? And then cash book will have capital and revenue transactions. You purchased land also, it will be there in cash book. You paid for selling. I mean, you paid for purchasing on machinery also, it will be there in the cash book. But here you record only revenue transactions. Clear? In P&L, that is basically income and expenditure, you record only revenue transactions. Now, related to any year to be recorded. If it is related to any year, it has to be recorded. Here, even if it is not paid or received, it is recorded. Can you see the difference? I did not pay salary of all 12 months. All 12 months. One employee was there. All the 12 months I didn't pay him salary only. Now don't ask me why is he still there. Okay, that's a different deal. Okay, but he's not there. I mean, he's there. We are not paying salary. 12 months. In my cash book, how much will be shown as salary payment? Cash book 0. In my receipt and income and expenditure account, how much will I show as salary? Full 12 months. And then it will go to balance sheet as outstanding salary. Clear? So do you understand in income and expenditure, whether you pay it or not, it will always be there in income and expenditure account. Clear? Now next. How to prepare, you have to understand, okay? Expenses. Expenses. If, now, only two things can happen here. They'll give you receipt and payment and tell prepare income and expenditure account. They'll give you income and expenditure account and tell prepare receipt and payment account. Is this clear? Now, expenses, receipt and payment is there. Receipt and payment is there. Clear? Now, first of all, we'll see how many people are there in class. Okay, good. Simply, I felt like in the middle. Okay, I just wanted to know how many people are there. What were you doing like this for? Neck. What time you are going? After completing? What? Okay. After this, we'll do incomplete records then. Yes. Is this clear? Now, a company accounts got over 2 days back for you, right? Oh. Full planning. See, Charan, unlike you, locking the door and doing something else instead of studying. What did you think? I was talking about him watching anime. Why are you laughing? Huh? Oh, you thought playing PUBG. PUBG is not there now. It's called something else. What is it called? BGMI. In the I is what? India. PUBG copy paste India's mode. That's it. Huh? Okay, I didn't play PUBG also. Last game I played on mobile was Mini Militia. That was also good. But only hacked version I knew to play. In the regular version, you can't fly forever. In the hacked version, you can fly till heaven also and come back. But it was a good game. Okay, now let's continue. Receipt and payment account, if it is given, and we have to prepare income and expenditure account. Receipt and payment account is given, and we have to prepare income and expenditure account. Is this clear? Possible? Is it possible? Yes. What is given to you? Cash book. Okay. What do you have to prepare? Like a P&L. Okay. So now understand this. Record only related to current year, even if it is not paid or received. Now what you will do? Here I'll tell you, okay, trust me, in NPO, right? Entire game is about outstanding and prepaid. Entire game is about outstanding and prepaid. If you get that concept right, then there is nothing in this. Now, expense paid is given. If it is receipt and payment, I will have expense paid. Outstanding expense of last year. Outstanding expense of last year. Okay, will it be paid this year? Yes. But is it this year's? No. Minus. Understand this. What are we preparing? Income and expenditure account. When you're preparing income and expenditure account, I want only things related to this year. I don't want last year's. I don't want next year's. And I don't care whether it is paid or not. I want only things related to this year. Now, outstanding of last year. You can look at the chart, okay? You can look at the chart. Outstanding of last year means what? Last year's expense. Even if it is paid this year, it is last year's expense minus. minus. Outstanding of this year means what? This year's expense. Even if it is not paid, no problem. It is this year's expense. Add. Clear? Then prepaid expense of last year. Last year it was prepaid expense. Last year prepaid expense means what? Last year already paid. But it is related to which year? This year. Add. Prepaid expense this year means what? You already paid it. But it is related to which year? Next year. Minus. Did you understand how you are going to prepare? When receipt and payment is given and you are preparing income and expenditure account, again I am repeating. Okay. If receipt and payment account is given, in that what you will find is expense paid. Expense paid. Now, if there is outstanding of last year did not pay, paid this year, but which year's expense it is? Last year's, minus. Outstanding of this year's, that means this year it is outstanding, but it will be paid in the next year. Which year's expense it is? This year. Add. Prepaid last year already paid, but belongs to which year? This year. Add. Prepaid this year already paid, but belongs to which year? Next year. Minus. Is this clear? This is how you will move from receipt and payment to income and expenditure account. Clear? Expense. When you are talking about income, okay, you usually don't use the word outstanding for income. It is called as accrued or receivable. Now, in receipt and payment account, what will be there? Income received will be there. Income received will be there. Now, last year's receivable. Last year's receivable means the last year's income. Even if it is received this year, it is last year's income minus. This year receivable means did not receive, but it is this year's income. Add. Income received in advance of last year means already received last year, but it's received in advance. That means it is related to this year. Add. Income received in advance of this year means already received this year, but it's related to next year. Minus. That time you will get your value what you have to take in income and expenditure account. Is this clear, guys? Now, the opposite can happen in life. Correct? Expectation was something. Reality is something else. Now, income and expenditure can be given and they can ask receipt and payment account. Correct? Tomorrow would have been a beautiful day, but now reality is something else. Correct? No. If things were good tomorrow, you would bunk all classes and you would meet all your friends who are doing tuitions and take the money and go to buy clothes. What is 15th? Salary day. Your friend's salary day, you know it. 15th. Who are these people on paying salary on 15th, man? Drawings, middle of the year. 6/2. Yes. Now, expenses. See, actually, no, it's good, man. I'm happy that you broke up. Okay, I'll tell you why. Okay, now you have a zeal to pass exams. Seriously, I'm telling. Okay, I've told the regular class people, I've not told ICU people, okay. I've told regular class people, see, I'm not against relationships. Okay, I'm fine with people being in relationship and studying for exams. But I am not fine with the timing of the relationship. Sometimes the timing of the relationship is very bad. That way, no, May can become September, September can become January, January can become May again. Are you getting my point? So if any of you are already in a relationship from more than 1 year, then no, best, you'll clear exams. No problem. It's not a distraction because already everything is done. All that butterfly stage is done. Okay, initial stage of the relationship is called as butterfly period. That is done. Okay, initial stage butterfly period means what? This is your world. That is the initial butterfly stage. That is your world. Outside you don't know anything. Okay, if you are in this stage, right, then morning you can't get up without sending good morning message and receiving good morning message. Night you can't sleep without sending a good night message and receiving good night message. Okay, and one call if you get, you will leave everything and you will go and answer that call. Okay, now you can't study at all. So if you are planning to get into the relationship now, then you will not clear in September. Neither will you clear in January. Okay, maybe if you clear in May, you are lucky. But next September, pakka you will clear. Okay, if you get, yeah, 1 year, butterfly period, right? But if you are already in a relationship, right, since 1-2 years, okay, doesn't matter. Doesn't matter. Now it's stable. Okay, all that phase of being on the call and telling then, but nothing is there to talk. Telling then, that is over. Clear? Now it is peace. Now you know your goals, the other person knows their goals. So you will be going in the right track. But the timing should never be wrong. So now when the timing goes wrong, attempts can go bad. Clear, especially for CA. Really, I'm telling. I'm not against relationships. I feel most of the faculties who will come here and teach you, all of them will be in relationships. All. Maybe you can write in caps, all. Okay. But just get the timing right. That's all. I'm not against it. I have seen a lot of chartered accountants, husband and wife, both clearing foundation, inter, finals at the same time. It's just that you need to get the timing right. Okay. Because if you feel that your entire world is only you both, then ICA will remind you again that he is also there. Are you getting my point? ICA will tell, hello, I am the big boss. You will be in the relationship, no, like this. ICA time and time again will tell, big boss. That big boss voice will come. Okay, so just get the timing right. Don't get the timing wrong. Now, so why I was telling you is very good. Breakups can make people pass. Yeah, it can really make people pass. I had a student who's on the day, next day is a CA inter exam. Okay, CA inter exam starting next day. He was in a relationship for 5 years. His parents knew, the girl's parents knew. Next day is the CA inter exam starting. In his house, everybody had gone for a function. You know what was that function? His girlfriend's wedding. Everybody in the house has gone for that function. His girlfriend's wedding it is. Literally. Moe, yes. That day he told his friends, if at all by some chance I clear this attempt right, I will surely become chartered accountant. And he cleared that attempt. Next day he went and wrote the exam, he cleared that attempt. And then he became CA. I mean, that was inter, but after that he joined articleship, he went on to become CA. It's just that motivation can come from heartbreak as well as heart join also. Okay. But heartbreaks are always motivation. Okay. Heart join, the timing should be right. And you should think from your head. Are you getting my point? You should think from the head. Even if you're in a relationship, you should think from the head, not from the heart. Heart doesn't think. Heart just pumps blood. Are you getting it? That much science I learned. Heart just pumps blood. So think from your head. What is right? If the person is right, person will wait. Okay? There is no concept of affecting exams and all. If it was BCom exams, now I would have told do whatever you want. Do whatever you want. Get into relationship whenever you want, do whatever you want. Go wherever you want. Go and write bakwas in the exam, you'll still pass. Correct? But I say you can't do no. If you write correct only, they are not giving marks. No. Then what will we do if we write bakwas? Okay, now, if they give receipt and payment in the question and you have to prepare income and expenditure account. If they have given receipt and payment account and you have to prepare income and expenditure account. Wait, that we finished, right? Now, sorry, if they give income and expenditure account and you have to prepare receipt and payment account. Now, what is the goal of receipt and payment? Whatever is received, whatever is paid, doesn't matter which year. Whatever is received, whatever is paid. Now, starting point is expense for the year. Income and expenditure account will tell only expense for the year. Expense for the year. Now, last year outstanding means last year's expense, but paid in this year. Add this year's outstanding, this year's expense, but did you pay this year? No, minus. Are you getting this? See, the concept only changed when you're preparing receipt and payment account and when you're preparing income and expenditure account. Income and expenditure, you are thinking whether it is paid or not, whether it is received or not. This year I'll take this year only. Clear? Now when you're preparing income and receipt and payment account, whatever it is, only if I pay, I will take it. Now last year's outstanding, last year's expense, but paid this year, so add. This year's outstanding, not this year's expense only, but not paid this year, so minus. Clear? Then prepaid expense of last year. It is which year's expense? This year, but paid in the last year, minus. Prepaid expense of this year. It is which year's expense? Next year's expense, but paid when? This year, add. Clear? See, that time you will get the expense paid during the year. Next, when we go to income for the year. Where will you get income for the year? In income and expenditure account. Now, income receivable of last year. Receivable of last year means last year's income, but it is received this year, add. Income receivable of this year. That means this year's income, but it is received in the next year, so minus. Income received in advance last year. Income received in advance last year is this year's income, but already received, minus. Income received in advance of this year. That means it is next year's income, but received this year, add. Did you understand how to prepare resident payment account and income and expenditure account? Yes. I'm telling you, this is the major goal in NPO. Rest of the things it's manageable. This is the one where people go wrong. Okay. Now, next, you can do the same thing with ledger also. Expense account you can do with the ledger also. Tell me, what is the entry for outstanding expense? What is the entry for outstanding expense account debited to outstanding expense? What is the entry for prepaid expense? Prepaid expense debited to expense. Prepaid expense to expense. Is that correct? Now what you will do? What is the entry? Last year's outstanding should be reversed this year. This year's prepaid, last year's prepaid should be, this year's prepaid should be added and last year's prepaid should be reversed. So when you reverse, whatever you told just now will become opposite in the ledger and you'll get the balancing figure which will go to income and expenditure account. Clear? What plus minus we did, it happens in the ledger also. Clear? Ledgers usually they don't ask when you're preparing an income and expenditure account, resident payment account. If you're comfortable with the ledger, you can follow that. Otherwise, just understand the logic of plus minus, you'll get the answer. Clear? Now, some special items are there which we have to discuss before we start discussing the problems. Entrance fees. What is entrance fees? The fees that is paid to enter the club. Usually, it is paid only once. Entrance fees is once. A renewal will happen after that. That is called as annual fees. So, if it is entrance fees and they don't tell anything, capitalized. Capitalized means add it to capital fund. Add it to capital fund. Clear? If mentioned in the question, then income and expenditure account, income. Sometimes they will tell 50% of the entrance fees to be capitalized. That means other 50% should not be capitalized. If it is not capitalized, it is revenue. If it is revenue, entrance fees is a income for the club. You are not the member. You are thinking from club's point of view. Income added. Is this clear? Next. After that. If it is general, it is going to income and expenditure only. General means if they tell annual membership fees. You are paying every year, recurring in nature. It will go straight into income and expenditure account. Okay. Life membership fees. Can you pay it 1,000 times? No. Only once, right? Capitalized. Add it to capital fund. Add it to capital fund. Annual membership fees. See, income and expenditure account. Income. Is this clear? Donations. Two types are there. Specific donation, general donation. General donation means that guy gave you money and told do whatever you want with it. Do whatever you want. You spend for anything. You eat lunch with that. Or you do anything. I am not bothered. General donation, income and expenditure account, income. Specific donation means they are telling this donation I am giving only to construct building, for example. Then it becomes a building fund. Clear? That is specific donation. Balance sheet will be shown as liability. Is this clear? If question is silent, general donation only always. If they tell donation, it's always general donation. If it is specific donation, they have to mention. Otherwise, how will we know? Clear? Next, honorarium. But people are doing some Titanic scene over there. Honorarium. Yeah, man, really from the outside, what I don't know what they're doing. Which one you're talking about? Yes, honorarium. Because of that only, the Titanic sank. Because when they were doing that, that guy was supposed to see in the binocular, was looking at them. Then it went and hit the iceberg. Somebody's butterfly he went to see. He should have focused on his butterfly. That was the iceberg. Everyone would have survived in the Titanic. Yes, honorarium means what? What is honorarium? It's expense. 100% it is expense. What is honorarium? There are some guests. They'll come to your college. When you're in school and all. Okay. Suddenly they'll tell, please, next period is not there. All of you go to the auditorium. That time, whatever happens in the auditorium, you are not going to pay attention. Because it's like a free period for you. Correct? But there somebody will come and talk some bakwas for 2 hours. Correct? Sometimes they'll do some magic show, removing the pigeon from here and all, making it fly. Correct? It's done in school, right? Now that person, do you think he's mad to come and do all that for free? No. They'll give him something, if not money also, they'll put one shawl. Okay, they'll put one shawl and they'll give some dry fruits. Okay, and then Harivana will be given. Okay, all that they'll give, right? Now, this and all is expense for the club. Correct? Expense. Honorarium is something that is paid to honor the services of that person. That person is not an employee. Employee means we have called it salary. We are honoring the services. Expense always debited to income and expenditure account. Clear? Legacy. Legacy means what? Legacy means what? One old grandfather of Charan was there. Old great grandfather. Great grandfather of not Charan. Great grandfather of Charan's neighbor. Charan's neighbor was there. God knows what he saw. Okay, all the property he wrote in Charan's name and went. Clear? This is legacy for Charan. Will he receive this again and again on the death of that person? Only once that person can die. He is not undertaker to die again and again. You know, in WWE there is one person called Undertaker. Many times he has died. Okay, now legacy is amount received due to will on the death of a person. There are some people usually they don't have children and all. So what they do, all their property they write to some organization. So for them it is one time it is added to capital fund. It is added to capital fund. Clear? Endowment fund. Endowment fund means what I tell you. Imagine you have one sports club. I am telling I will give you 1 lakh rupees. Now you will tell, okay, donation, I will enjoy, I'll spend it off. Already Charan's face, there is one smile. He is already, when I told I'll give 1 lakh rupees, he already started smiling. But I put a condition. This 1 lakh you should not spend. Then you'll be thinking like, why the hell are you giving me this 1 lakh then? Correct? I am telling, don't spend this 1 lakh. You invest this 1 lakh. Put it in FD. Whatever comes from that annually, use that for the sports. Did you understand? This is endowment fund. I am giving you 1 lakh, put it in FD. And the FD certificate should be with me only so that you don't break the FD. Okay, then annually you will get interest, right? Use that for conducting the sports day. Use that for conducting sports day. So now, specific donation which should not be used must be invested. Must be invested. Whatever return you receive from that, use for the purpose. From that, if you get 10,000 rupees, that is used for the sports day. Is this clear? Imagine for sports day, you have used only 8,000 rupees. It will be there in the balance sheet added as unused. Is this clear? This is endowment fund. Sometimes you can find it. See example. Prize fund I have over here. Prize fund. 2 lakh. In balance sheet, you will find 2 lakh and you got the money. So you will find cash in the balance sheet. Clear? I took this prize fund and I invested it. Now cash went and in the balance sheet, prize fund is still there. And you will find prize fund investment. This investment is giving you return of 10%. So now on 2 lakhs, you will get 10% interest. So now your prize fund has gone to 2 lakh 20 and cash is sitting over here 20,000 because you got the interest. Now price expenses are 19,000. If price expenses are 19,000, from 220, 19 goes away and 2 lakh 1,000 is still there in the fund and your cash also has gone down to 1,000. Are you following this? If at all price expenses are 22,000, then you cannot remove 22,000 from the price fund. No, because 2 lakh has to be maintained. So you'll remove only 20, 2 lakh will still be there and cash became fully empty over here. Now income and expenditure account you will debit 2,000. That means what you cannot remove from the fund, it will be taken from the income and expenditure. What you can remove from the fund just gets reduced from the fund itself. Clear? That's it guys. That is it with the concepts. Now you have to solve 4 questions. Trust me, it will cover all the concepts. We'll go slow a little because NPO, I think many of you have not studied only. Have you? How many of you who told NPO skipped NPO? Okay, few. Now, go to the end of the question. What is given in this question? Income and expenditure account. Clear? And what is there at the end of the question? You are required to prepare resident payment account for the period ending and balance sheet. Now, I'll tell you, even though they told this, there is one more thing that you have to prepare. Opening balance sheet. Why you are preparing opening balance sheet? To find how much was the capital fund, not capital, capital fund. Now this is December 23. Oh, December 23, where are you? Did you find it? Yeah, I got it. ABC Sports Club. Is it ABC Sports Club? Yes. Now December 23, ABC Sports Club. Listen. Okay. Always first to prepare the opening balance sheet so that you have the capital fund. Can you see every information is given? 31st December 2021, 31st December 2022. Okay. So to prepare opening balance sheet, you have info, and to prepare closing balance sheet also you have info. Clear? Now, go into the question. Can you see government securities? Now, go and prepare. See, this is the solution actually. Receipt and payment and income and expenditure. But you have to prepare the opening balance sheet as a working note. Okay. Government securities 18 lakh. Asset or liability? Asset. So go and write 18 lakh. Then subscription outstanding. What is it? Asset or liability? Asset. You might feel confused. Subscription outstanding means subscription is an income for the club. Okay. So income, they should not use the word outstanding, but how many times should ICA? Sometimes they follow, sometimes they don't follow. So they should have used subscription receivable. But subscription outstanding is income receivable. Is it asset or liability? Asset. Clear? So you can see 70,000 over here. Then subscription received in advance. Income received in advance is liability. So can you see it on the liability side? 2,000. Next. Salary unpaid outstanding expense is also a liability, 10,000. Then furniture, land and building, sports equipment, stock of stationery, all are assets. Furniture, land and building, sports equipment, stock of stationery, all are assets. Now cash is not there. Okay, cash was not there in this list. How did you get cash? Because receipt and payment is, sorry, somewhere down they should have given. Yes, here. Cash on 31st December 2021 is 1,08,000. Can you see that they have given the opening balance of cash? So opening balance of cash should go to opening balance sheet. Everything is done. What is missing? Capital fund. The purpose of preparing this is to get the capital fund. This capital fund of 40,24,000, what we will do? Go and put it into the balance sheet as a starting point of capital fund. If they did not give balance of cash, then they should give you at least one of the balance, closing balance. Now they gave you opening balance. They didn't give you closing balance. Now when you prepare receipt and payment account, the closing balance will be the balancing figure. If they are not given opening balance, they should have surely given you closing balance. Then receipt and payment account balancing figure will be opening balance. That you will put it over here. One of them. Now if you see receipt and payment account, right? See here, closing balance, balancing figure. This will go to balance sheet. Are you getting this? Yeah. Now, understand this one by one. Salary. Salary is receipt or payment. Receipt or payment. Payment. But do you have something related to salary? Salary unpaid. Tell me one thing. Last year's salary unpaid means it is paid in the current year. What are we preparing? Receipt and payment. Last year's unpaid means it is paid in the current year. So 2,35,000 plus 10,000. Clear? And this year's unpaid means it is not paid. It will be paid in the next year. So minus 15,000. That means you should get 2,30,000 as the salary. Is that correct? Is that correct? Now if you go to receipt and payment account, salary 2,30,000. Are you following this? 2,30,000. Next, after salary, you have stationery expense. For stationery, do you have any outstanding and all? No, stock of stationery is there. Stock of stationery is there. So now what you're going to do? You are not going to take stock of stationery. You are going to take stationery consumed. Whenever you have stationery or something like this, no, You're not going to take stock of stationery. You're going to take stationery consumed. If I purchase stationery, is it an expense? No. If I use the stationery, only expense? No. Imagine you guys have ICU batch, right? So there are exams. So they bought lot of paper and all and kept. Now 80% of the paper you have consumed it, but they purchased 100% of the paper. 20% of the paper is not used at all. It is going to be used maybe somewhere else. Now tell me, if I ask you, what is the expense till now? We are following accrual concept, right? What is the expense? 100% of the paper or 80% of the paper? 80% of the paper. Only what is consumed. Remember, manufacturing account, not raw material purchased, raw material consumed. Is this clear? So now, if you see over here, stationery expense is 30,000. But do you have opening stock and closing stock of stationery? So opening stock of stationery is how much? 3,000. Okay, what is the purchase of stationery? 30,000. What is the closing stock of stationery? 5,500. So minus 5,500. That time you will get what is the value? 27,500. 27,500. Do you have any creditor for stationery and all? I hope you have taken the correct numbers, right? 3,000, 5,500. And this is 30,000. Yes. Have a look. Oh, 32,500. What is this? Working note 2. Opening balance 3,000. Closing balance 5,500. Income and expenditure. Oh guys, we have made the mistake. You know what is the mistake? Not we. I have made the mistake. You know what is the mistake? The mistake is in income and expenditure account what you are seeing. Okay, in income and expenditure account what you are seeing, isn't it already stationery consumed? We are preparing from income and expenditure account receipt and payment, not from receipt and payment income and expenditure. This is already stationery consumed only. In receipt and payment what I require, not consumed. What did I purchase? Correct? So if I tell you stationery consumed, the formula is opening stock plus purchases minus closing stock. I already know the consumed. The consumed is 30,000 is equal to opening stock 3,000. Purchases I don't know minus closing stock 5,500. Are you getting this? So now when you do this balancing figure, okay, 30 minus 3, 27, 27 plus 5, 32,500. Did you get how they got 32,500 over here? If you are doing, if receipt and payment account was given to you, then you are preparing income and expenditure account. That time you have to put stationery consumed. Income and expenditure is given to you. Now you are preparing receipt and payment account. Receipt and payment account is cash book. You don't care how much paper you have used. How much did you purchase, that much money went. Correct? That is why the reverse calculation has happened over here. Is it clear, guys? Okay, so that is why this 30 became 32,500. Now this stock of 5,500, where will it go? It will go to closing balance sheet. Can you see stock of stationery? 5,500. Clear? Next, after that, rents and taxes. Did you have any adjustment for rent and tax? Nothing, right? Receipt or payment? Receipt or payment? Are you Nirmala auntie to think and tell the tax is receipt or payment? For you it is payment only, no. 5,500 straight away. Sorry, 5,500, no, 5,000. 5,000. Insurance, is there any adjustment for insurance? No, no adjustments. Directly 2,000. Next, office expense, no adjustment. Directly 8,000. Just like final accounts, many fill in the blanks will be there, direct. Some things will have calculations. Okay. Then, depreciation on building. Depreciation on building, depreciation on furniture, depreciation on sports equipment. Is it going to be there in receipt and payment account? No. Because depreciation is a non-cash expense. It cannot be there. What should be there in the receipt and payment account is whatever you have paid to purchase a building or whatever you got when you sold the building. Clear? Now, how much is the depreciation on building? 37,500. Is it 37,500? Now, if you look at the building here, 20 minus 37,500. Are you getting 19,62,500? That means nothing is purchased, nothing is sold. Nothing is purchased, nothing is sold. If you look at the depreciation on furniture, it is 1,200, right? From 20, if you remove 1,200, 20,000 minus 1,200 if you do, you'll get 18,800. But how much is showing over here? 19,800. That means 1,000 rupees furniture you have purchased. If you go to receipt and payment account, you should have furniture purchased 1,000. Is this clear? Now, depreciation over here, sports equipment 1,000. How much is the sports equipment? 35,000. From 35,000, if I remove 1,000, I should get 34,000. But it is showing closing balance of 39,000. That means what? 5,000 rupees sports equipment you have purchased. If you purchased, money went. So you see the payment side 5,000. Is it clear? Now, did you understand why depreciation won't be there in receipt and payment account? Because depreciation is a non-cash expense. Now, excess of income over expenditure. Is it surplus or deficit? Excess of income is surplus or deficit? Surplus. Where should it go? Where should it go? Net profit, where it goes? Balance sheet. Can you see it get adding to capital fund here? If we have to prepare income and expenditure, we only have to find it and add it to capital. Now we are supposed to prepare receipt and payment account. Okay, next. Subscription. Income or expense? Income. That means receipt or payment. Receipt. Now understand this. Can you see this 2,50,000 over here? 2,50,000. What am I going to prepare? Receipt and payment account. Now, subscription outstanding of last year. That means it is received this year. So add 70,000. Subscription outstanding of this year. That means it is not received this year. It will be received in the next year. So subtract 1 lakh. Subscription received in advance of last year. If it is received in advance last year, already received last year, minus 2,000. Subscription received in advance this year. That means it is received this year. It is next year's, but it is received this year. Add 6,000. What are you getting? 2 lakh? Yeah. 2,24,000 subscription. Okay. 2,24,000. What is this balance brought down? Opening balance of cash. Receipt and payment, right? Opening balance of cash, which was given in the question itself. Next, after that, all the subscription, no, which is there in the other side of the balance sheet. Okay, that is for end of the year. Everything will go to balance sheet. Subscription outstanding, subscription received in advance, okay, salary unpaid, everything will go to balance sheet. Okay, next. Where is it? Yes, interest. Any adjustment for interest? Nothing. Directly put 90,000. Okay. Then you have donations. Anything they have told about donations? No. When they don't tell anything about donation, it's called as general donation. So straight away it will go to income and expenditure account. Then miscellaneous is anyways miscellaneous income and expenditure account. Okay, directly you are going to put into receipt and payment. Now, if you see the receipt and payment, no, everything is filled. What was missing? The closing balance of cash. Balance carried down is the closing balance of cash. Now, the closing balance of cash, what you are going to do? You are going to put it into the balance sheet, 181,500. 181,500. 181,500 will go into balance sheet. Now what you are going to do, rest of the things are all fill in the blanks. Government securities, subscription outstanding, furniture, land and building, sports equipment, salary outstanding, advance subscription, everything was there in the table. Directly fill in the blanks from the table. So other than what was there in the table, what is the other things that is not there in the table? One is we had to calculate the closing balance of capital and we did not know the opening capital fund, which we got from opening balance sheet. Rest of the things are all fill in the blanks. Done. Did you understand this question? This was asked in December 2023. Next, our next question which we have to solve is June 2023. Is June 2023. Is it clear? Good morning, good morning, good morning. You have a long way to go. Okay, the evening is still young. Okay, evening is still young. It is not even, you have not even seen darkness outside. It's only 5:30. You have a long way to go. Trust me on that when I'm telling that. Okay. Now, following is the receipt and payment. Okay, June. Let's go to June exam, guys. June 2023. 4A, yeah? 4A, yes. Let's begin. When I start the question, right, should focus. When I end the question also, you should focus. That's a different thing. Okay, now listen. Following is a resident payment account of Pune Medical Aid Society. Same kind of questions, whatever I have picked now, 4. Same kind of questions. If you have done the study material, these are there over there. Okay. Now, 31st of December 2022. What do you see printed in bold? Receipts and payments account. That means what should you prepare? Income and expenditure account. Now, whatever you thought in the previous question, you will think opposite of that. Now, you don't care whether money came or not. Is it this year? Only those things I'll take. Clear? Now, the following is the additional information provided. Can you see subscription? For subscription, separate table only they have made. In fact, same structured question is there in the study material where subscription has a separate table. Okay, other things you see. Stock, this, everything is there. That's it. Now, see the bamboos, okay? Stock of medicine is a bamboo. Amount due for medicine supply is another bamboo. These two things will make you think and it will play with you in the exam. If you have not seen it. Value of equipment and value of building. Nothing. You don't have to think about it at all. Subscription is an entire different topic. Now, let's start. What are you going to prepare first? Opening balance sheet. Without opening balance sheet, you can't do anything. Correct? So now the first thing that you're going to prepare as a working note is your opening balance sheet. Okay? For opening balance sheet, do you have the numbers in this part of the question? Where they've told 1/1/2022. Subscription due, asset or liability? Subscription due, asset or liability? Asset. Where is it? 2,500. Clear? Subscription received in advance, asset or liability? Liability, 1,800. Clear? Next, stock of medicine, asset or liability? Asset, 12,500. Where is it? 12,500. Amount due for medicine supply. Amount due for medicine supply. That means you have to pay. Liability. 12,000. Clear? Next. Value of equipment. Asset or liability? Asset. 21,500. Value of building. Asset or liability? Asset. 65,000. 65,000. Is it clear? Now, after that, you need one more thing which is not there in the table. Go to the receipt and payment account. Can you see opening cash in hand? Asset or liability? Asset. Go and write 12,000. Now, all the things you saw, no? One thing is given indirectly over here. Interest on investment, 10,000. That means investment is 1 lakh and I have to put it into opening balance sheet. Now you're like, sir, wait. You can't put it into opening balance sheet, sir. First, you prove it to me how it is not purchased in this year. If it is purchased in this year, how will investment be there in opening balance sheet? How I know that it is not purchased in this year is it there in receipt and payment anywhere? In the payment side? Investment? No. Are you getting my point? That is how it is proven that investment is coming from the previous year. And can you see investment is not given directly? So if you find a table with past year and this year information, don't just blindly put everything from the table and close the opening balance sheet. Search for other things. There can be hidden information like this. There can be also this which you might miss. Opening balance of cash. Clear? Now you have your opening balance sheet. Everything is there. This is your capital fund. Where will you put this capital fund? You will put it into closing balance sheet. Correct? Go to the closing balance sheet. That is your opening starting point. 199,700. Is this clear? Now, shall we start? Yes. Now, first thing I am looking at is subscription. Receipt or payment? Receipt. It is sitting only on receipt side. Okay, receipt. That means income or expenditure? Income. 65,000. Can I put directly 65,000? No. I cannot put. These 4, why they are sitting here? 65,000 is your, now what are you preparing? Income and expenditure or receipt and payment? Income and expenditure. That means I am only bothered about this year. Correct? This 2,500 last year's due is last year's minus 2,500. 3,500 is this year's due, but it's still this year's 3,100 add. Subscription received in advance last year. Last year received in advance. But which year's it is? This year's. Add 1,800. 1,400 received in advance. Which year's it is? Next year's. Minus 1,400. 66,400. Only 66,000. 66,000? Yes, correct. Now, this should be there where? On the income side. 66,000. Obviously, they have given working note for this. I'm just showing you the calculation there itself. Now, after that, donation. Nobody told you anything. That means this donation is general. 25,000. Charan is very happy about general donation. Specific donation he doesn't like. Interest on investment. What to do? Income. Directly 10,000. Next, charity show collection. Whenever you have like this now, show collection, that, this and all, you can put it. But always see on the other side, if there is anything, charity show expense is there. So, instead of writing 16,500, you can show the net amount. So, that will become 16,500 and 2,750, 13,750. When you have a show in income and expenditure, show it net. How much did you spend? How much did you get? Net amount. Is it clear? If now your question should be, even if I put on opposite side, is it wrong? No. You'll still get marks. But better to show as per the correct presentation which is there in the answer key. Clear? Next. This is done then. Medicine supply. Medicine supply payment. Is it an expense? No. No. This is a very, very important part of this question. Medicine supply is not an expense. Medicine consumed is an expense. Imagine I bought 10,000 bottles of this thing. What is that? Drips. Medical Aid Society, right? Not a single patient came for drips. Is it consumed? No, right? So will it be taken as expense? No. Now understand this. What we need to take is medicine consumed. Very important adjustment. Very important. Okay. Now understand this. Can somebody tell me medicine consumed? What is the formula? Opening stock plus purchases minus closing stock. Okay. Opening stock of medicine, I have over here 12,500. I'll take 12,500. Plus purchases, I don't know. I don't know purchases. You're thinking this is purchases. No, this is payment. This is just a payment made. Sir, what is the difference between purchase and payment made? Sir, if I have creditor, what I pay to the creditor is not purchase. What I purchase is something else only. Clear? So purchases I don't know. Closing stock I know. 17,250. Now what should I find? I should find purchases. To find purchases, I can prepare one creditor's ledger. Creditors ledger. Now they told amount due to medicine supply. That means 12,000 opening balance. Amount due to medicine supply. That means 16,500 closing balance. Clear? Amount paid is there over here. 35,000. Amount paid will be debited to creditors. Now automatically you are getting the missing figure over here. This is your purchases. 39,500. Is that your purchases? Now can I add that over here instead of writing P? 39,500. Now you will get your medicine consumed. 34,750. Is that your medicine consumed? Yes. Now when you go 34,750, where is it? Over here, medicine consumed. Can you see 34,750? That means medicine ke liye what you have paid, that is not the expense. Medicine purchased, that is not your expense. Medicine consumed is your expense. So how will you get the purchase? When you prepare the creditors ledger. Is this clear? Are you following this? Anyone? Did you get this point? Yes? Now, next. Honorarium to doctor. What to do? Very good. Be happy. Expense. Honorarium to doctor. Next. Salary. Any outstanding and all? No. Direct. 36,000. Fill in the blanks. 950. Sundry expense. Fill in the blanks. Directly. Then purchase of medical equipment. Purchase of medical equipment. Will it go to income and expenditure account? No, it's an asset. It's an asset. What you have to do now? You have to see what is the medical equipment opening balance. 21,500. 21,500. Medical equipment asset account. 21,500 is the opening balance. Closing balance 37,200. Is that correct? Yes. Now, what do we know? There is one purchase of medical equipment. 25,000. 25,000. So you add 25,000. Can you see the difference over here? What is it? Yes. What is it? Depreciation. In income and expenditure account, I only need depreciation. Purchase of asset, will you put to your P&L? Only depreciation you'll put to your P&L. P&L here is income and expenditure account. Now you should find 9,300 depreciation. Clear? Now, did they tell you anything about our other asset which is building? Did they tell you purchase of building? No, right? So directly, difference is what? 3,250 depreciation. If there is no purchase, no sale, but still it has gone down. That means it is depreciation only. 3,250. So our last question, you didn't put depreciation into the solution because we were preparing receipt and payment account. Is this clear? Okay, this is your income and expenditure account, and whatever you get balancing figure, that is a surplus. Surplus will straight away go to balance sheet. Straight away go to balance sheet. Is it clear? Are you following this? Now, what else? Building minus depreciation. Equipment, you are going to take plus purchase. You have purchased one medical equipment. You will show minus depreciation. You have the balancing figure already. Why you are doing all this circus? Balancing, end balance is given in the question itself. Stock of medicine given. Investment given. Subscription receivable given. Cash in hand is the closing balance of receipt and payment account. Okay, subscription received in advance given in that table. Amount due for medicine supply also given in the table. In the balance sheet, there is nothing you have computed. Are you getting this? This is your question where you have to prepare income and expenditure account and balance sheet. Done? Next, let's go further. December 2022 exam. What a beautiful day. December 2022. What is the question number? What is this? I got it. Young Boys Club. What happened to you, man? Young Boys Club, I said. Okay. Now, why so many people are skipping NPO? What? It's easy scoring. NPO is not tough to score. Okay, get ready. Okay. Young Boys Club is also there in study material. It's called some 40 something youth club or something it's called. Is there? Same question is there in study material. Young Boys Club also. Now, December 2022 exam, income and expenditure of youth club, or sorry, young boys club. That means immediately you know that you have to prepare something. What is it? Receipt and payment and balance sheet. Balance sheet is constant. You have to prepare it. Okay. Now, receipt and payment account, balance sheet at 31st December 2022, balance sheet at 31st December 2021. You should tell IC here, don't worry. This if you would not tell also, I would do it. Without that, how I will start? Capital fund from where I will get? Okay. Now, like the previous question, nicely one table was made. You take the table and directly input everything. Here table is not made. Here table is not made. Now let me tell you, this we will read after we read the paragraph. Clear? This account was prepared after the following adjustments. Subscription outstanding 31st December 2021. Tell me, will it go to opening balance sheet or will it go to closing balance sheet? Will it go to opening balance sheet or closing balance sheet? Opening balance sheet. Asset or liability? Asset or liability? Asset. 700. Then, subscription received in advance. Will it go to opening balance sheet or closing balance sheet? Liability. 550. Clear? Next, after that, you have subscription received in advance 31st December 2022. Opening balance sheet or closing balance sheet? Closing balance sheet, you have to put it. Liability, yes. Where is it? Where is it? Where is it? Yes, subscription received in advance, 370. Can you find it? Next. Then, subscription outstanding, asset or liability, which balance sheet? Closing balance sheet. Can you see over here, closing balance sheet, 750. Done. So, balance sheet impact I am doing first. Because I don't have direct table given to prepare the balance sheet. Okay. Then income and expenditure account anyways I have to do. What did they give? Sorry, receipt and payment account anyways I have to do. Okay. Now, salaries outstanding at the beginning and end of the year was 600 and 150. So beginning and end of the year, we know the salary outstanding. So beginning of the year salary outstanding should go to the closing balance sheet, salary outstanding 600. And salary outstanding at the end of the year should go to, this should go to opening balance sheet, and salary at the end of the year should go to closing balance sheet 450. Is it clear? Next, from the question, general expenses include insurance prepaid to the extent of 150. This year they are talking about. So there should be a prepaid, 150 should be there in the balance sheet as prepaid. Clear? Next, audit fees for 2022 is still unpaid, outstanding. That means go to the question and see, can you find audit fees? If it is not paid, why is it there in the income and expenditure account? No. This year's only audit fees, whether it is paid or not, will be there. Any expense, whether paid or not, will be there in income and expenditure account. So 250 you are seeing. They said this year's, audit fees of 2022 is still unpaid. But still you are seeing in income and expenditure account because you follow accrual concept. So 250 you will find in the balance sheet. Which balance sheet? Closing balance sheet. Closing balance sheet. Can you see audit fees outstanding 250? Then during 2022, audit fees for 2021 was paid amounting to 200. Last year's is paid this year. That means, do you agree outstanding audit fees of last year is 200? Yes, it should be there in the balance sheet 200. Audit fees unpaid. Is it clear, guys? Next, after that, the club owned a freehold lease of ground valued at 20,000. They had a ground valued at 20,000. Did they purchase their ground this year? Check the receipt and payment. This is income and expenditure account. Did they tell you anywhere that the ground is purchased this year? No, that means ground was there last year also. Ground is there this year also. That means it should be there in the opening balance sheet also. It should be there in the closing balance sheet also. Sir, how are you going and writing directly with so much confidence? Ground, sir, don't you have to check depreciation? Land, it will not depreciate. Are you getting this? If it was some other asset, you would have checked for depreciations. Next, club had sports equipment on 1st January 2022, 2,600. Starting of the year, they had sports equipment of 2,600. So it should be there in the opening balance sheet, 2,600. Clear? And then they said, at the end of the year, after depreciation, balance is 3,600. That means what should be the balance in the closing balance sheet? 3,600. Okay, depreciation all we have to calculate. Let's do that later. Don't worry about that. In 2021, club raised a bank loan. We are in which year? 2022. In 2021, they raised a bank loan. Why are they telling us 5,000? This loan was outstanding throughout 2022. Last year, they took a loan. 1 rupee they didn't pay this year also. That means, do you agree this loan should be there in the opening balance sheet also, closing balance sheet also? So 5,000. Can you see 5,000 in the opening balance sheet loan? And 5,000 in the closing balance sheet also you have loan. Let's get to that. Okay, right now we don't know. If income and expenditure it is there, if it is paid or received, then we'll put it into receipt and payment account. Okay, now on 31st December 2022, cash in hand amounted to 1,600. See, here they give closing balance. You are asking this doubt, no? Here they give closing balance. There they give opening balance. So closing balance was balancing figure. Here they have given closing balance. So opening balance is balancing figure. So 1,600 we can put only to the closing balance sheet, 1,600. But the cash of this one will remain pending. I have to prepare receipt and payment account, get the balancing figure, then only I can complete this. Usually, I would directly prepare opening balance sheet and get the capital fund easily. Now, unless I get this, see, this will be shown here in your receipt and payment account. Can you see this is the balancing figure? Once you complete this fully, then you will get this balancing figure, and that will you'll put it into opening balance sheet. Then you'll get the capital fund. Then you'll put it into closing balance sheet. Did you get it? Okay. Now, next. That's it. Now, whatever adjustments you read, right? Please remember it. That is the only task. Remember it. If you don't remember, then I remember it. Okay. What other option do we have? Next. Salary. Did you have any adjustment related to salary? Yes, it was there. If you don't remember, I have to remember. Yes. Yes, it was there. Outstanding. Can you see over here? salary for last year outstanding, salary for this year outstanding. Can you see this? At the beginning and end. Now, what are you preparing? What are you preparing? Resident payment. You don't care about which years and all. Did you pay this year? That's all you bother about. So 3,750. Correct? 3,750. Last year's outstanding is how much? 600. So do you agree that is paid this year? Add 600. And this year's outstanding is how much? 150. That means it is not paid this year. So minus 150. 4,200 is your salary. Now go and check. Yeah. Did we do ulta? Resident payment we are preparing, right? Is it salary 3,750? Yes. 3,750. Beginning it was 600. Salary outstanding. Clear? Now this, yeah, we are going ulta. 3,750 is the salary. 3,750 is the salary which is expenditure in income and expenditure account. Okay, last year's outstanding means what? Last year's outstanding means what? It is paid this year, right? Salary outstanding at the beginning and at the end of 2022. Add and minus 150. So you should get 4,200, right? Some bamboo they have done, I think. Salary. Where is it? Yeah, this one only. By income and expenditure account 3,750. Okay, salary is transferred to income and expenditure account. Opening was, hey, what bakwas. From where they got these numbers? In the question, how much is it? 600 and 150. Suddenly in the solution, they got some new number 450. Are you getting this? Let's check the question once again. Whether they made the mistake. Oh, 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 oh. 600, 150. And in their own balance sheet, ICAI, in the balance sheet, they are telling outstanding salary as 450. Which is wrong. In the question it was given 150. And here 600. Are you getting it? Question it was wrong. But we are seeing question in the exam now. How we know the answer key? Are you getting this? So obviously they make these kind of errors. Let's hope in the answer key it was 150 only. In the answer key it was 150. If the answer key is 450, that means be happy, you will get grace marks. How else it is possible to solve? Did you understand why we were getting salary as the wrong answer? Because this is not 150, they have taken it as 450. Now you will get the same number that they got, 3,900. Clear?
3,750, they take 3,000.
No, that they took correctly. That's correct. Where is it? Here it is. Yeah, that's correct. 3,750 only they took. Did you understand the mistake? Okay. See, when it is 150, they could have solved in 150 only. I don't know why suddenly they made it 450 in the solution. Now, next, after that, general expenses. Do you have any adjustment for general expenses? Do you remember? I remember. Yes, general expense includes prepaid 150. Okay, that means go to your resident payment account, general expense, add the prepaid back, it will become 1,650. Why? Prepaid means what? Next year's, but it's paid this year. So add it. We are preparing resident payment. Doesn't matter which year. You paid this year, add it. Is this clear? Salary, I'm taking it. Next, audit fees. Audit fees. Did I pay this year? No. Last year's I paid this year. Last year's audit fees was how much? 200. So can you see audit fees 200? Okay. Next, after that, secretary's honorarium. They didn't tell anything. That means you paid it. 1,000.
Two fees, right? Interest fees.
No. Audit fees 250 is last year's audit fees. Sorry. This year's audit fees, which is unpaid. If you want me to show the calculation, right? 250. This year's outstanding. That means not paid. Minus last year's outstanding. That means paid. Plus. You'll get 200 that time. That's what you do usually. Just because numbers are exact match, you are not doing it. For subscription and all, what you would have done, last year's outstanding is last year's received in this year, add. This year's outstanding minus. You would have done that, no? This is last year's audit fees only. Outstanding of last. Huh? This is outstanding of this year. When you're calculating receipt and payment account, what you do? Outstanding of this year, not this year's, minus. Outstanding of last year, not this year's, but still it will be paid this year, add. That is how you got to 200 here. Didn't get it. You got 200 directly, right? You're not getting this calculation. Now, see, if I would tell you, outstanding audit fees of last year, of previous year is 220 and current year is 300. What you would do? You take the number from the income and expenditure account, 250. You would get 250 from here. Then from this 250, what you would do? Last year's outstanding, that means it is paid this year. You would add 220. This year's outstanding, that means it will be paid next year. You would minus 300 and you would get some answer, 170. You take that in the receipt and payment account. Now here you are getting confused because this is 250 in the income and expenditure account. This year's outstanding is how much? 250, full 250. So minus 250. Last year's outstanding is how much? 200. So you add it because it is paid this year. Got it? No? Yes, 200. Now next. Stationery printing. Is there any adjustment for stationery printing? Nothing. Directly 450. Then annual dinner expense. Is there anything? No. But there is also one contribution for annual dinner. Don't bother. Because in receipt and payment account, you'll put every receipt, every payment. So 1500. Directly you can write 1500. Next. Interest and bank charges. Did you have any adjustment for interest and bank charges? No. Directly you will write 150. Then depreciation. Will you put it into receipt and payment account? No. Depreciation you don't like it at all. Okay. Depreciation is related to what? This club had sports equipment. How much was the sports equipment? 2600. Depreciation means it has to be reduced, right? How much is the depreciation? 400. So from 2600, when I remove 400, it should become 2200. But they are telling closing balance is 3600. That means 1400 of equipment is purchased. Is that correct? So now if you see 1400 here, payments 1400. Is it clear? Now, next, after that, surplus. What will you do to surplus? Put it to balance sheet. Capital fund we didn't find. We'll find it later. But add the surplus to balance sheet. 1500. Clear? Capital fund we'll get to know only when we get the cash opening balance. Now, you see here, subscription. Subscription is always a beautiful thing in NPO. How much is subscription here? 8500. Correct? Take your calculator. 700, what should you do? Last year's outstanding, what should you do? This year you will receive. This year you will receive. So you will add. Received in advance last year. Already received minus. Already received minus. Subscription received in advance this year. That means it is next year's, but you received it. Add. Subscription outstanding this year. Didn't receive it. Minus. The 8500 plus minus plus minus. How much you are getting? 8270. So now you should have 8270 in your receipt and payment account. 8270. Clear? Did you get it? You just need to know from which route to which route you are going. Receipt and payment to income or income and expenditure to receipt and payment. Next. After that, entrance fees 250. Did I tell you anything about entrance fees? No. But where is it entrance fees? In income and expenditure account. Now understand, the biggest question about entrance fees is whether I should put it into income and expenditure account or I should put it into balance sheet. Receipt and payment, it will always be there because you received it. Don't get that confusion now. 250 straight into receipt and payment. And they did not capitalize. They put it into income and expenditure. Now, contribution for annual dinner, 1000. Annual sports meet, 750. Everything done. Now, only thing that is missing, this is given balance, closing balance is given at the end of the question. Now, only thing that is missing is opening balance. That was the balancing figure we were looking for. when we got this 1580, what did we do? We will go and put it to closing balance sheet 1580. That time we will get our capital fund as the balancing figure. Yeah, sorry, opening balance sheet. That time you will get our capital fund. You will take this capital fund and put it to our closing balance sheet. Rest of the things in the closing balance sheet I am not even discussing. Because sports equipment, they had given the closing balance. See, everything is marked also. We discussed it that time itself. Okay, so can you see balance sheet will tally and should tally? Clear? Done. Any doubts with this? Next. One more question we have from NPO which will revise some more concepts. June 2022 exam. June 2022. What is the question number? See, there were things like consignment and all before. Now they've removed it. Yeah, 4A. 4A. Last question from NPO, guys. Okay. I'm not taking any other question after this from NPO. Even iPad is tired, I think.
Yeah, but we are not tired.
Yes, that's the spirit. That is the spirit. 29 days to go. What? What? AC. It's working perfectly, right? Wait. One question is there. Wait. After that, I'll give you time to go. Huh? Leave it. If I leave it, no, it will be difficult for me, man. The scrolling will be difficult. Wait, give me 1 second. This fellow is troubling. Okay. Now it will move. Sorry for the technical glitch. We'll be back in 1 minute. If I don't do that, for me toggling will be difficult. Okay. Now, let's start guys. 53rd question. In middle, some company accounts questions are still there. Okay, don't think we have done 53. Now, following is the receipt and payment account of Mumbai club. I'm telling you from beginning of time, guys. Mumbai Indians. We are focusing on Mumbai Indians. Why to fight about RCB and CSK? Huh? Bambani. Money is with Bambani. He can buy umpires. Correct? If you know, you know. No ball will not be shown on TV. Because umpire will not give no ball. Yes. The following is a receipt and payment account. If you know, there is one, if you are CSK fans, there is one match, one CSK final which CSK lost, where Malinga bowled to Shardul Thakur and Shardul Thakur was LBW. That was actually no ball. It was never showed on TV. Because Bambani, Paisa. What? That is not there. There was no DRS only. What? There was DRS? No. DRS got over. CSK didn't have DRS. They had emptied all the DRS before that. But still, whatever it is, it was a no ball, yes, I agree. But what a bowler Malinga, man. What a bowler Malinga. Entire season that year he didn't play. In that match also 3 overs he got hit. But final over championed over he bowled. What an over. But it seemed that bowling slower ball was Rohit Sharma's idea. Recently in some interview they said, because Rohit Sharma knew Shardul Thakur very well, because both play for Mumbai. He said that this fellow will just swing the bat, bowl slower ball. Bat will be swung and it will be LBW. Crazy captaincy. And crazy umpiring. Yes. Okay, receipt and payment of Mumbai club. If they are giving receipt and payment of Mumbai club, what am I going to prepare? Yes, very good. Income and expenditure account. That's the spirit. Still we have 2 chapters to go after this. One for 25 marks, one for 10 marks. Huh? No, it's not there. That is some wrong posting. I am still trying to finish it today only. I have not I don't want to go to tomorrow. Huh? I'll give you breaks.
Company you do tomorrow.
Today's for CA students there is no Sunday, Monday, man. No Sunday and all. You should forget the concept of day only. Day and night you should forget.
Morning you will get company.
I can't come in the morning. Who told 10:30?
Message is there. 10:30. Right. Sir, right till class 6. Yes, sir.
No. This is the same thing you did to Shashi sir also.
No. We didn't.
Because of which it went to Monday for him also.
We didn't.
See, I have a simple deal, okay? Let's go all the way and we'll finish it. It'll be crazy. Crazy.
50 days.
I don't mind. Huh? Yes, let's continue now. We are still at 6 o'clock, by the way. Yeah, we are still at 6 o'clock. You can't talk anything before 8:30, no? Okay, we are still at 6 o'clock. Now, following other resident, when are you writing exam? That's it. I just wanted to remind, I forgot when is the exam. When is the exam? Correct, okay. Too many days ago. Josh, how is the Josh? Hi, I am only telling. Hi, it is hi. I don't want to hear only. Yes, let's continue, guys. Following is the resident payment account of Mumbai Club. Mumbai Indians, Bambani. Huh? Yes, for the year ended 31st March 2021. Listen here. Okay, now, resident payment of Mumbai Club. This question also is there in study material. Okay. You are given the following additional information. Can you see one nice table is given, small one. After the table, in the table subscription due, you know what to do. Amount due for printing is outstanding. Checks unpresented being payment for repair. Oh. Unpresented means you have to subtract from the bank balance. Otherwise, you have to sit and prepare BRS later. Are you getting my point? Linking of concepts. We don't remember only, sir, BRS. What is that? Yesterday when we thought it was good, that time it got over. Then after the bad thing started, we don't know at all. Yes, checks unpresented being payment for repair, that means it is unpresented. You have to reduce it from your bank balance to show the correct bank balance. Interest not yet entered in the passbook. Enter it. That means it is interest receivable. Then estimated value of machinery and equipment that you will use to calculate depreciation, other things, all that you will calculate. For the year ended 31st March 2021. What is our year end 31st March 2021? Honorarium to secretary is to be increased by a total of 20,000. Increased by a total of 20,000. Increased. Okay. Now go and search whether there is honorarium. Very good. Honorarium to secretary 1920. 40,000. In resident payment, 1920's honorarium is there. That means last year's honorarium is paid this year. And they are telling this year, please increase it by 20,000, which is not paid 1 rupee also. That means what you have to understand, this 40,000 what you are seeing over here. Can you see this 40,000 here? Is it this year's honorarium or last year's honorarium? Last year's honorarium. Is it paid or not paid?
Paid.
Which year we paid? This year. That means last year's balance sheet, should you find it? Outstanding. If you go to last year's balance sheet, which will be a working note, can you see outstanding honorarium 40,000 on the liability side? Did you get it? That means this year's honorarium is how much? This year's honorarium is how much? They said honorarium is to be increased by 20,000. So 40,000 plus 20,000, that makes it 60,000. Outstanding. But should I put that 60,000 into income and expenditure account? Should I put that 60,000 into income and expenditure account? Yes. Not a single rupee I paid, but still it will be shown in income and expenditure account. That is why I gave the build up at the starting only. 12 months salary I didn't pay. Will it be there in income and expenditure account? Yes. Did you pay the honorarium of this year? No. You paid honorarium of last year. Still it will be there 60,000. And this 60,000 will also be there in the balance sheet as outstanding. This will also be there in the balance sheet as outstanding. Not a single rupee you paid. So what was there in the receipt and payment was last year's honorarium. That means last year's honorarium was not paid. That means in opening balance sheet, it should be there. Clear? Next. Groundman is to receive a bonus. Is to receive. Is to. That means didn't receive. That means you have to pay. That means you have to pay. In income and expenditure, will you put this bonus? Yes. In income and expenditure account, will you put this bonus? Not even 1 rupee paid, but still you will show it as expense. And in the balance sheet, you will show it as outstanding bonus. Is this clear, guys? Next. These two important lines which were there at the end, we have sorted that out. Now, subscription due of last year. We'll go to last year's balance sheet. Asset or liability? Asset. Very good. Can you see asset here? 15,000. Good morning. Good morning. Hello. Yes. Now, subscription due of this year. Where will it be? Will it be there in this year's balance sheet? Yes. Can you see 10,000 in this year's balance sheet subscription receivable? Clear? Now, next. Amount due for printing. Expense. Outstanding expense. Previous year. So, it should be there on the liability side. Amount due for printing. And amount due for printing. This year's outstanding. Yes, it should be there over here. Printing 8,000. Clear? Next. Checks unpresented being payment for repair. Unpresented being payment for repair. So what should you do? You should subtract it from the bank balance. Okay. Now opening balance sheet. Go and see. Can you see bank balance? We don't know. So where will we find it? In the receipt and payment account. How much is the bank balance over here? Can you see cash in hand 20,000? Should go to opening balance sheet. So in the opening balance sheet, can you see cash 20,000? Correct. Now, can you see savings account 193? That savings account 193 will be there here also. Then, can you see current account 60,000? Current account 60,000. Now, what will you do? 60,000 minus 30,000 because unpresented check is there. 60,000 minus 30,000, that is when the current account balance went down to 30,000.
Current account balance not given, we can subtract from savings account.
We can subtract from savings account. Then they would have not told current and savings. No, they would have told only bank balance.
That means in this case we can subtract from savings account also.
No. This case you can't.
Why?
See, because current account is used for business. No. Current account is the account which is used for business. If they would have not told current account, then the other one, they would not call it savings account only. They would have called it as bank balance. Are you getting it? Because they call that savings, they're calling this current. So you subtract it from current account itself, not from savings account, unless current account is not there. Okay, next. Here, can you see at the end of the year, savings account is how much? 2,04,000. That means it should be there in the balance sheet. Closing balance. Can you see 2,04,000? Then cash is how much? 25,000. Can you see 25,000? Can you see that? Yes. Current account is how much? 20,000. I can't write it directly. I have to subtract the check unpresented. Check unpresented. 20,000 is the current account balance. When the check unpresented gets subtracted, how much will be the current account balance? Minus. That means bank OD 5,000. Now your question, nobody asked this question, okay, but I am only asking. Your question should be, sir, if check is unpresented, passbook they didn't pass the entry, but we have already passed the entry, no. Then why we are doing minus? Because the balance which is given to us in the question is as per passbook. As per passbook. Are you getting my point? Check unpresented means what? I gave the check, they didn't present it for payment. That means usually cash book already entry is made. Then why are we again subtracting from bank balance? I have already subtracted. But for us in this question, the amount that is given is as per passbook. As per passbook. That is why we are not able to get it. Are you getting this? That is why directly we are subtracting. That is why my 20,000 current account balance, when I put this check, it goes into bank OD situation. Are you getting this adjustment? Okay, next. We have interest not yet entered in the passbook. Interest not yet entered in the passbook. How much? 2,000. Interest not yet entered in the passbook is 2,000. So what should you do? Interest receivable or interest payable? Interest receivable or interest payable? Interest receivable. Okay, you can see interest receivable over here, interest due. Now, when I told interest not yet entered in the passbook, you felt like telling enter it. But passbook I can't enter, bank has to enter. Correct? I know interest is there, bank, passbook they have not entered yet. So I will show it as receivable. Is this clear? Now, estimated value of machinery and equipment. Estimated value of machinery and equipment. One will go to the opening balance sheet 80,000. Another will go to the closing balance sheet 1,75,000. Are you clear with this? Okay, now opening balance sheet is completed. Can I get the capital fund balancing figure? Yes. Can I get it? Yes. 2,88,000 is the opening capital. Where will I put this? In the closing capital starting point. Is it clear? Now our story starts. Bank interest. Receipt or payment. If you are confused, no, just look at the heading here. Receipt or payment. In the receipt and payment only we are taking the number. Receipt or payment. Receipt. So is it income or expenditure? Income. 5,000, can I take it as income? No. Because there is one interest which is not entered. Interest receivable is there. This year receivable. Did not receive. Should I add it when I prepare income and expenditure account? Yes. So when you go to your income and expenditure account, interest 7,000. Can you see interest 7,000 here? 5,000 plus 2,000. They've shown the calculation also. Next, after that, donation and subscription. Do they have some adjustments? What are you preparing? Income and expenditure account. That means this year's only we should take. Whether received or not, this year's only we should take. Now, subscription due of last year. 2,50,000. Subscription due of last year. What should you do? Subscription due of last year. What should you do? Last year's it is. So minus 15,000. Subscription due of this year. What should you do? Add 10,000. So that makes it 2,45,000. 2,45,000. Is it clear? Any doubts with this? No. Go and write 2,45,000. 2,45,000. Is it clear? Next, after that, entrance fees. Entrance fees. What should I do? Did they tell me anything that entrance fees should go to income and expenditure account? No. What will I do? Entrance fees will go straight into balance sheet. It will get added to capital fund. Did I tell you that rule? Entrance fees will always be capitalized. Entrance fees will always be capitalized unless they tell you something else. But entrance fees will always be there in receipt and payment account. Clear? Next, contribution to club night. Contribution to looks like it's your friend's receipt and payment account. I think it is. It is your friend's receipt and payment account. Okay. Contribution to club night. Now look for other things. Proceeds from club night. Contribution to club night. Proceeds from club night. On the other side, can you find some club night expenses? Can you find club night expenses? 10,000 contribution plus proceeds from club night. That means on the club night we sold tea and coffee and all. I don't know what you are thinking. Tea and coffee and all we sold. And we got 78,000. Total 88,000 money I have. But that day, club night expense was only 38,000. 88 minus 38 is how much? 50,000. So club expense, if you're writing net, you can write it as 50,000. Did they write net? No, they have written separate only. Proceeds from club night, 78,000. Receipts from bar room. Oh. Club night expenses, 30,000. Contribution, 10,000. What? Contribution was 78, right? Oh, sorry. 10,000, yes. 10,000. Okay, club night expenses minus contribution. They have put the amount over here. And that other one, quietly they have put on the other side. Are you getting this? You could have taken net amount only. Now 78 is over here. 28 is over here. You could have taken net amount 50,000 that side. Are you getting this? They put one star. We'll curiously see. Alternatively, the profit from club night can be shown as 50,000. Oh. Are you getting this? We could have done that only, no. Why alternatively? That only could have done, no. One you are minusing. Why you are leaving the other one? Are you getting this? Okay, next. Sale of equipment. Will sale of equipment go to my income and expenditure account? No. Now, let's keep this pending because we'll see if there is any purchase of equipment. That's it. Let's leave it now. Bar room receipts. Oh. Bar room. Hello, what you're laughing? They're talking about the lawyers. Bar room. Bar council. What you thought? Okay, bar room receipts 20,000. Mumbai club. Mumbai Lawyers Club it is. Okay, bar room receipts 20,000. So it will go to the other side. Okay, you can see the receipt and payment account. Can you see 20,000 here? Can you see 20,000 receipts? Okay. Next, go to the payment. Groundsman fees. Groundsman fees. Did you have something related to groundsman? That was bonus. Bonus already taken. Okay, groundsman fees directly you write 75,000. 75,000. Because can you see bonus? That time only we marked the bonus as 20,000. Okay, next. Purchase of equipment. Purchase of equipment. Now this purchase, sale, everything we'll see the circus. What is the opening balance of equipment? Go to the question and see. What is the opening balance of equipment? 80,000. Can you see opening balance 80,000 over here? 80,000. Opening balance of equipment is 80,000. Purchase of equipment. If I purchase equipment, the balance should increase. How much is purchase of equipment? 1,55,000. 1,55,000. That means it should become 2,35,000. Clear? Sale of equipment. How much is sale of equipment? 8,000 minus. That means it should become 2,27,000. But they are telling closing balance is 1,75,000. 227 minus 175, how much is it? 52,000. What is this 52,000? No. My equipment, how will I consume? I'll eat it. How can I consume equipment? It is depreciation. How can I consume equipment, man? Depreciation on machinery or equipment. Equipment, I'll eat it. Consume. One button today, one more button tomorrow. Okay, no. Next. Okay, guys, let's continue. Now, rent of ground. Any adjustment for rent and all? No, directly go and write rent of ground. Where is it? Rent of ground, 25,000. Next, printing and office expenses. Can I take printing and office directly? No, I cannot take printing and office directly. Why? Because there is amount due for printing, 10,000. How much is the printing and office expense? 30,000. Last year's outstanding minus this year's outstanding plus. That means it will become 28. Should I find 28? Yes, over here. Printing and office expenses. Clear? Next, after that, repairs to equipment. Nothing directly. Oh, no. Repair also had that check, unpresented. Check unpresented. Last year's unpresented. You should minus. This year's unpresented. You should add. So same circles will happen. 50,000 minus 30,000 plus 25,000. That will make it 45,000. Clear? Outstanding only it is. Next. Nothing next. That's it. Okay. This surplus, where will it go? It will get added to balance sheet. Rest of the things in the balance sheet we have already discussed. This is your not for profit. This thing. What is that? Organization. Yes. Done. We are done with this not for profit organization. Let's proceed. Okay, guys, welcome back. Okay, incomplete records. All the chapters till now, whichever we have done, we finished all chapters except company accounts and incomplete records. Correct? All the chapters which we have done till now. Okay, we had a process. We discussed the concepts. Then we went into problems. Incomplete records. If I have to write. Incomplete records. There is actually no concept to write. Learn. What concept will you learn from incomplete records? Incomplete records concepts are not taught in incomplete records. Incomplete records concepts are taught in accounting process, inventory, bills of exchange, final accounts, NPO, some outstanding prepaid treatments, and partnership, nothing from partnership is there. These are the chapters from where you learn incomplete records. So basically incomplete records is what? Whatever you have learned in other places, if you have learned it properly, then incomplete records is done. Clear? Now, that is it. So directly, I am writing questions. What are the questions we have to do? Illustration 10, illustration 9, illustration 2, sorry, practice question 2 and practice question 3. Illustration, okay, SM10, SM9, PQ2 and PQ3. Clear? These are the questions you have to deal with in incomplete records. Now, good morning once again. Okay, now tell me one thing. In incomplete records, what are we actually doing? We are preparing trading P&L balance sheet. What then, sir, in trading P&L balance sheet we already did in final accounts. What again we are doing here? Difference is there trial balance was given to you. Here trial balance is not given to you. That means we have to draft things and we have to prepare trading P&L balance sheet. Now, if I have to tell you, just roughly, okay, just roughly if I have to explain to you incomplete records, okay, in incomplete records, we have to do a certain number of things. Certain number of things what we have to do is, one, you have to prepare debtors account. You will have to prepare debtors account. First of all, tell me how many of you have not studied incomplete records here? Then what are you doing in marathon? Huh? But able to attend, okay.
Sir, we know what it is not.
Concept you know, okay. Now, debtors account. Debtors account you will have to prepare. Tell me what might be the reason you are preparing debtors account? To find? To find balance. No, actually I'm not completely wrong. There are some questions where balance carried down you have to find so that you can put it into the balance sheet. But most regularly to find credit sales. To find credit sales. Are you getting this? Yes. See man, you required 3 marathons to actually find his true personality. In the 4th marathon only you got to know who he was. Till now, tell me if I am wrong. In the first 3 marathons, you actually thought, no, one innocent guy is coming and sitting in the back, attending marathon without talking to anyone, is going. Correct? You thought like that, no. Now you know who is. How? Huh? Yeah, but so you got very comfortable because it is accounts. Then you have to come tomorrow. Accounts is favorite subject. Online you will not see, you'll be in that WhatsApp group. Talking to those 4 people. So those 4 people know that you know those 4 people.
Yeah.
Sister, 1 bestie, and 2 jobless people. You tell them to watch this video. Okay, now listen. Debtors account done. Now next, creditors account. Okay, obviously it is to find credit purchase. Sometimes it can be balance carried on. Okay, to find credit purchases. Is this clear? Now, debtors are always linked to one thing. What is that? There can be bills receivable account. Now, what can go missing in bills receivable? I don't know. Anything can go missing in bills receivable. But without closing bills receivable, I will not be able to close the debtors account. It is linked to each other. Then there is always bills payable account. So, if you have not studied bills of exchange, you will not be able to crack this bills receivable and bills payable code only. Clear? Bills payable account, it will link your creditors account. Is this clear? It is linked to your creditors account. Now, after that, you might have to prepare cash account and bank account. Go on preparing cash account, bank account. We actually don't know what can be the missing figure. Sometimes cash sales, sometimes amount paid for electricity also can be missing. Anything, one of them will be missing. So if one of them is missing, you can always consider that as a balancing figure. If 2 things are missing, then you have to find a different alternative to reach there. Apart from this, these are the working notes which you might have to do. This is the maximum working note you might have to do. Okay, debtor, bills receivable, creditor, bills payable, cash, bank. Clear? Now after that, why are you here is to prepare trading, P&L, and balance sheet. And we don't know what is the capital. So as a working note, you might also prepare opening statement of affairs. Opening statement of affairs. Now, Charan, tell me, why is it called opening statement of affairs and why is it not called opening balance sheet like we just called it in NPO? Because here there is no, here there is no books of accounts to call it balance sheet. Starting of the year, I don't know whether it is actually the balance sheet, but from the limited information, I am telling this is the statement of my work, statement of the activities that I do. So that's why it's called as opening statement of affairs. Clear? Then after doing everything, you can call it as balance sheet or you can also call it as closing statement of affairs. Is it clear? Now, this is it. That's it. From here, everything is what you have already studied. You have to apply it. Now, let's go into question number 10. Okay. What do we need? Incomplete records. Can you spot incomplete records anywhere? No. Okay, listen. Now in incomplete records, right? The approach that you're going to follow in the exam. I tell you the approach that you're going to follow in the exam. Questions are huge. Questions are huge. You have to go in the order of the question and you should read the question once and complete the solution at once. You're not coming back into the question for anything. So what you're going to do is you should have your opening statement of affairs, trading, P&L, balance sheet, everything open. Okay, and working notes. The debtors account, creditors account, whatever you need, everything should be there. When you keep everything ready, then you'll be able to fill it all at once. Clear? Otherwise, if you think that I will prepare this later when you come back into the question and search, it's a mess. Clear? Now, Mr. Anup runs a wholesale business wherein all purchases are made on credit. What does this statement tell you? No cash sales, no cash purchases. Is that correct? He's telling that all purchases and sales are on credit. He furnishes the following balances. Now, debtors opening balance and debtors closing balance is there. Okay, where should you put the debtors opening balance and closing balance? It should be there in the opening balance sheet. It should be there in the closing balance sheet. And in the debtors account, it should be there as opening balance and closing balance. Can you spot the 70 and 92? Now, if you go into the question, debtors opening balance 70, closing balance 92. That means closing balance is given. We are not preparing debtors account to find the closing balance. Okay. Then closing balance sheet. Can you find debtors as 92? Then opening balance sheet you need. In the opening balance sheet, a lot of working notes are there in this question. Opening balance sheet, can you see debtors should be there as 70? Spot all four places where it had to go, it has gone. Now, next. Bills receivable, 15,000 opening balance, 6,000 closing balance. That means in the opening balance sheet, there should be 15,000 bills receivable. And in the closing balance sheet, there should be 6,000 bills receivable. And in the bills receivable account, there should be opening balance and closing balance. Clear? Sorted. Next, bills payable. This is actually the most full-fledged question which we have. Anup question. Okay, so focus. Bills payable 12,000 and 14,000 should be there in opening balance sheet and closing balance sheet. Now, and the respective ledger. Correct? So, opening balance sheet, you can see bills payable as 12,000. Closing balance sheet, bills payable should be, where is it? Here, 14,000. And in the respective ledger, it should be there. So, bills payable ledger, opening balance on the right hand side because it is a liability and closing balance over here. Clear? Sorted. Are you seeing how the numbers are impacting? Next, sundry creditors, opening balance, closing balance. Where should it go? Sundry creditors should be there in the opening balance sheet 40. then it should be there in the closing balance sheet as 56. Can you see 56 here? And in the respective ledger, there should be opening balance and closing balance 40 and 56. Are you able to navigate all this? Clear? Next, inventory. Where will it go? Tell me. Inventory opening and closing. Where will it go? Balance sheets and trading account. Balance sheets and trading account. So 110 and 190 should be there in the respective balance sheets. So opening balance sheet you have 110 and closing balance sheet you have 190. Do you have 190? 190. Then it should be in the trading account as opening stock and closing stock. So in the trading account, can you see 110 and 190? Clear? Next, bank account. Where should it be? Opening balance, closing balance. It should be in opening balance sheet and closing balance sheet and the ledger. Correct? So can you see the ledger of opening? Can you see the opening balance sheet? Bank is 90. And in the closing balance sheet, the bank is how much? 87,000. And you should find it. Okay, you should find it in the ledger. Can you see cash and bank together? They have done. Look at the bank column. Opening balance 90 and closing balance is 87. Clear? Now, you have cash 5,200 and 5,300. That means opening balance is 5,200. Can you see it in the cash column? And 5,300. It also should reflect in the balance sheet 5,200. And in the closing balance sheet, you can see cash as, where is it? 5,300. Did you understand everything that is given from the table? Now, go to the opening balance sheet. Can you see everything is marked and entered? That means missing figure is what? Capital. Opening balance of capital. Where will this opening balance of capital go? It will go into the closing balance sheet start point. So closing balance sheet, you should find that 2,38,200 or whatever it is. Yeah, 2,38,200. Is it clear? Same thing we used to do in NPO, but we used to call it as capital fund. Okay. Now, summary of cash transactions during the year. They've given the cash transactions. Everything has to be entered. When you enter, you will get the results automatically. Now, deposited to bank after payment of shop expenses 600 per month. After paying shop expenses, they have deposited to bank how much? 600 per month. That means, is it 600 into 12? 7,200.
Yes.
Is the shop expense 7,200? Yes. Yes or no? Yes. So now, where should it be first? And salary also will take 9,200 into 12. That is how much?
10,400.
Okay, that is your salary. Then personal expenses 1,400 per month. So 1,400 into 12, 16,800. Clear? After doing all this, they have deposited to bank how much? 7,62,750. After doing all this, they have deposited to bank 7,62,750. Tell me the entry for depositing 7,62,750. Bank account debited to cash account. So you should find here in your cash and bank account which you have prepared, bank account debited to cash account. Is it clear? Okay. Next, shop expenses. Where should you find? You paid the shop expenses through cash or through bank? Through cash or through bank? You paid it through cash, not through bank. You have paid it through cash. Because after paying that, then you deposited the money into the bank. So, shop expenses is 7,200. What is the entry for shop expenses? Shop expenses account debited to cash account. Can you see shop expenses here 7,200? But it also should go to one more place. In final accounts, where will it go? Shop expenses. It will go to P&L. Can you see in your P&L shop expenses 7,200? Is it clear? Next, where should the salary go? Salary also should be there in the P&L. Can you see salary 1,10,400? And it also should be there in the cash account. Cash account, you should find 1,10,400 credited to cash. Because salary account debited to cash is the entry. Clear? Next, drawings. 16,800 drawings. Where should it go? What is the entry for drawings? Drawings account debited to cash account. So can you see in cash you are seeing 16,800. It will not go to P&L. It will go to balance sheet and you will subtract from capital. You will subtract from capital 16,800. Can you see this? Next. After that, cash withdrawn from bank. Cash account debited to bank account. You deposited that time, now you are withdrawing. Cash account debited 1,21,000 and bank account 1,21,000. Is it clear? Next, cash payment to supplier 77,200 for supplies. What is the entry? Cash payment to supplier 77,200. What should be the entry? Creditors. Supplier is creditor. Creditors account debited to cash account. So here you are finding 77,200 in cash and in creditors account. Can you see 77,200? Clear? And they told 25,000 for furniture. Furniture account debited to cash account. Can you see in cash 25,000 over here? And where should you find it? In balance sheet. Yes, you should find it in balance sheet. Can you find it in balance sheet? Furniture 25,000 in the balance sheet. Clear? Luckily in this question no depreciation. Otherwise depreciation also would have been applicable on this. Next, checks collected from customer but dishonored. Actually no need to pass entry because when you receive the check, bank account debited to debtor. Then when it gets dishonored, then debtor account debited to bank. Okay, now let's see if they have entered or they have just ignored. You can ignore also, otherwise you have to pass two entries. That's it. They have entered it. Can you see? To bank, by bank. 5,700, 5,700. It gets dishonored. Clear? Then in the bank also you should find double effect of 5,700. 5,700 here and 5,700 here. Clear? If you would have ignored also, would it have mattered to you? Because you are not doing accounting, right? From incomplete accounts, you are preparing final accounts. So if you have missed this also, it wouldn't have mattered to you because it's a null effect over here. Clear? Now, bill accepted by customer. Bill accepted by customer. Journal entry, please. Namige, yes. Bills accepted by customer. What is the entry? Bills receivable account debited to debtor. Bills receivable account debited to debtor. Can you see your bills receivable here? 40,000. Can you see your debtors here? 40,000. Clear? Without you giving journal entry, I am not proceeding on anything on incomplete records. Okay, next. Bills endorsed. It's like revision of all the other things we have done. Bills endorsed. Creditor account debited to bills receivable. Creditor we are endorsing it to creditor account debited to bills receivable. Can you see how much is the 10,000, right? Yes. In bills receivable, can you spot this 10,000? And in creditor, you have to find this 10,000 to bills receivable. Is this clear? Next. Bills discounted 20,000. Discounting is 750. That means you got only 19,250. What is the entry? Bank account debited. Discounting charges debited to bills receivable. Let's spot it in the bills receivable account. By bank, by discount. Clear? And you have to find it in the bank account also. 19,250. But the 750, where will it go? Straight to P&L. It should be in P&L. It's expense, right? Expense 750. Where are you? Okay, they've added that 750 discount to some other discount which is also there. Okay, 750 discount. Next, after that, bills matured and duly collected. Bills matured and duly collected. What should be the entry? Bank account debited to bills receivable. Bank account debited to bills receivable.
Duly collected means we need to consider discount.
No. Bills receivable, what discount will be there? No. Duly collected means on due date it's collected. Correctly collected. Duly collected means correctly collected. Okay. So bank account. Can you see two bills receivable? And in bills receivable account, you should have by bank. Okay, they have written by bank, bills collected on maturity. Are you following this? Next. Huh? I'm getting that smell. What they are also getting. The Vicks smell. Yes. Bills accepted. Tell me what should be the journal entry? Bills accepted. Bills accepted. What should be the journal entry? Bills payable. Bills accepted is bills payable. Entry. Creditors account debited to bills payable. Creditors account debited. Okay, creditor is there over here to bills payable 24,000 and here 24,000. Are you spotting this?
Yes, sir.
Yes, you have to do it at once. You can't come back into the question in incomplete records. If you come back, that means you have missed something and it's going to be a mess. Okay. Paid supplier by check. Supplier is creditor. Creditor account debited to bank. Creditor account debited 3,20,000 and in bank you should find this 3,20,000. Is it clear? Next. Received 20,000 on maturity of one life insurance policy of the proprietor by check. Bank account debited. Very good. 2. Bank account debited 2. Bank account debited 2. Bank account debited 2. Bank account debited 2. Capital account. You are getting money which belongs to owner into the business. How can it be drawings? When he takes it is drawings. So bank account debited to capital account 20,000. Can you see 2 capital 20,000? And the 20,000 should get added to capital. Go to balance sheet and you will find 20,000 getting added. 20,000 added to capital. Is this clear? Next. Rent received 14,000 by check for the premises owned by proprietor. What should be the entry? Bank account debited to. Bank account debited to capital. Premises belonging to the owner. Who are you? Your business. Entity concept. 14,000 should be added. Add rent over here 14,000 to capital itself and in the balance sheet, in the bank account, you should find that 14,000. See here also 2 capital. Not 2 rent, 2 capital. Clear? Next. A building was purchased on 30/11/2021 for opening a branch for 3,50,000. Very good. Good thing, no? They opened branch. Okay. But bad thing is, and some expenses were incurred on this building, details of which are not maintained. Ayo. Building we know 3,50,000. After that some repair work, that, this and all they did. All that should be added to building only, no? All that should be added to building. That means this we can't find out now. We have to find out in the end. Somewhere this will be the balancing figure. After taking Vicks, first person coughing is her own. Before taking Vicks, she was sitting properly. The Vicks smell, man. Whole class is inhaling it. Let me. Oh, someone else started eating Vicks. From this side it came. RCB, you. Yes. Electricity. Let's get back. Hello. Let's get back. Did you understand why I did not pass any entry for this? Because building is purchased. For that I can pass entry. But along with building there are other expenses. Total amount I don't know. When I get that, I will find out somewhere. From some account I'll get it later. Either it can be bank or it can be cash. And cash we will not buy building. Then we'll be behind bars. So it should be bank only. Clear? Electricity and telephone bills paid by cash. Due 2,200. No, 18,700 paid. For that you can pass the entry. What is it? Electricity and telephone expenses debited to cash account. In the cash account, can you see 18,700? But 2,200 is not paid. Outstanding. So you should find that 2,200 as outstanding in the balance sheet. Can you find 2,200 as outstanding in the balance sheet here? Telephone expenses outstanding. And it should go to P&L also. P&L, will it be 18,700 or 2,200? Both. Yes. Both. It will be 18,700 plus 2,200, 20,900 accrual concept. Clear? Yes. Sir, will we get this questions PDF? I don't know, man. Which group are you in? Can you please tell me which group you are in? I'll ask them to put it to that. Yes. Let's go further. Other transactions. Other transactions means what? Till now, what we were saying then? Cash transactions. That means in other transactions, there cannot be any payment or receipt. Clear? Now, claim against the firm for damage 1,55,000 is under legal dispute. Legal expenses 17,000. The firm anticipates defeat. The firm is telling we are going to lose it. If we are going to lose it, it is not contingent liability. It is provision. Remember, on small unit is there in chapter number 1. Contingent liability and provision. So here, is it contingent liability or is it provision? It is provision. Did you pay this? 1,55,000? No. Case is still going on. Did you pay the lawyer's charges? Who told yes? Cash and bank transactions are here. That paragraph got over. It is below that. That means it is not paid. Are you getting this? So now both are not paid. But both are going to be taken as expense. Both are not paid, but both will be taken as expense. Even though it is outstanding. Yes. So in P&L, can you find 1,55,000 and also legal expenses 17,000? But both are unpaid. That's why I should find it even in the balance sheet. So in balance sheet, can you find it? 1,55,000 and legal expenses outstanding 17,000, and these two total outstanding will come to the outer column. Is this clear? Next, goods returned to supplier. Goods returned to supplier. Purchase, entry. Creditors account debited to purchase return. Creditors account debited to purchase return. Can you see to return outward 4,200? If it is credited to purchase return, it should also be subtracted somewhere else in my life. Where is that? Trading account. Can you see minus purchase return? Minus purchase return. Next, purchases we still don't know. Purchase return we know. Clear? Goods returned by customer. Sales return account debited to debtor. That means it has to be subtracted from sales. And in the debtor account, you should find it over here by return inward. Clear? Next, discount offered by supplier. Yes. Creditor account debited to discount received. So you go into creditor account and you can see here discount received 2,700. And it should also go into some other place. Where is that? P&L. In P&L, where will you find it? On the credit side. No profit side is there. On the credit side, discount received. Clear? Yes. After that, discount offered to customer. Discount allowed account debited to debtors. Discount allowed account debited to debtors. Sir, can't we give discount for cash sales? We can, but we don't have it in this question. First line they said everything is credit sales and credit purchases. Okay, now in debtors account, you should find the discount allowed, and it should also go to where? P&L, yes. It should go to P&L. In P&L, can you find discount 2,400 and two discounts? What is that other discount? Discounting charges. When you discounted the bill. Okay, now next. Business is carried out on a rented premises on an annual rent. On an annual rent of 20,000, which is outstanding at the year end. Owner had one premises which was given on rent. That money we added to capital. But the business where we are doing, there we didn't pay single rupee rent entire year. Are you getting this? Okay, rent account debited to what? Outstanding rent. That means it should be there in the P&L as rent, and it should be there in the balance sheet as outstanding. Where is it? No. Here, hiding. Yes, outstanding rent, 20,000. Is it clear? Done. Question is done. Question is done, right? Correct? Now, I'll tell you the order of closing. Order of closing is always cash and bank. Okay, but first bills receivable you close because it will have impact on the debtors, and bills payable you close. Now, first if you go to bills receivable, everything is entered. Closing balance also is given. What is this missing 3,000? That we saw there now, no? Okay. That we saw there, bills dishonored. Now, how did we identify in the exam? Opening balance we know. New bills we know. Correct? Bills endorsed also we know. Bills discounted also we know. Okay. Bills honored also we know. What can be there other than this? A bill is drawn Okay, bill is endorsed, bill is discounted, bill is paid on due date. Still there is some missing figure over here. What can be the thing? Only bill dishonored. No. What is the entry for dishonor? Debtor account debited to bills receivable. Debtor account debited to bills receivable 3000. Whose? Huh?
Father.
Yes. Now, is it done? Debtor account debited to bills receivable. Now, can you see your bills receivable is closed, but your debtor cannot be closed. You know why? Debtor, sales is not there, amount received is also not there. Sales is not there, amount received is also not there. That means amount received you will find somewhere else. After bills receivable, next thing you're going to close is bills payable. Now go to bills payable. Can you see everything is there? Opening balance, closing balance, everything is there. Missing figure is there on this side. That means natural assumption is bills are paid. How can it reduce? From 12,000 new bills came, it became 36,000, but closing balance is only 14,000. That means balancing figure is bills paid. Bills paid is bills payable account debited to bank. In bills of exchange, we usually don't use cash. Bills payable account debited to bank. So that 22,000 will also impact our bank. Clear? Bills payable done. Now if you look at creditors, creditor everything is there, no? Can you see everything in the creditors account? Amount paid through check, amount paid through cash, new bills, bills endorsed, return outward, discount received, opening balance, closing balance, everything is there. What is missing? Only one thing, that is your purchases. Purchases, the entry is purchase account debited to creditors. And this purchase also has to go where? Into trading account. Into trading account. Can you see 454 and then you get the net purchases. Clear? But why can't I do the same circus for debtors? Because in debtors, I don't know the sales. Plus, I don't know what is the amount received. Anyway, do you know the amount received? One check we received, it bounced. Correct? So, amount received is not there. This we have to find. Where will we find this? When we go to cash account. If you go to cash account over here, can you see everything is there in cash account? If you see, no, you made 7,62,750 deposit. You made shop expense payment, salary payment, drawings, creditor payment, furniture purchase, all this. To make all that payment, from where do you have money? On the debit side, there is only 1,21,000. That means credit payments are more than receipts. From where did the money come? Cash money can come from only two places. Actually, three places. One, you withdraw the money from bank. That has already been told. Other than that, you have only two places. One, either you make sales, cash sales. That is not possible because in the first line they said only credit here. Then second thing, from only one source you should get the money. That is what? Your debtor makes the payment. When debtor makes the payment, the entry is cash account debited to debtors account. Cash account debited to debtors account. Now you see the debtors account, you put this amount, automatically this will become your balancing figure. And what is this? Sales.
Building is not, is included.
That is in bank. That is in bank. We'll get to that. Okay, so this becomes your sales. Now where will this sales go? Straight into your trading account minus, and you'll get your net sales. Clear? Now only one ledger which you have opened is incomplete. Debtors closed, you found credit sales. Bills receivable closed, you found bill dishonored. Creditor closed, you found credit purchase. Bills payable closed, you found bills honored, whatever you paid. Cash closed, you found the amount received from debtors. Only bank is missing. Now when bank is missing and you're trying to find the balancing figure of bank, you are hoping that at least the balancing figure should be more than 350. If the balancing figure is less than 350, you're in deep trouble. You know why? They said building was purchased for 350 and some more expense when you add, it should increase. If at all you get balancing figure here, less than 350, that means you have done the bamboo, not ICA. Are you getting my point? So you have to find the balancing figure. In this question, it is 3,70,000 something. 3,72,000. Can you see balancing figure? That is by building. So if you do all the transactions properly, then only you will get the balancing figure over here. Clear? So wherever they have told paid by check, paid by cash, you should be very careful which column you are entering into. So 372 is your building. Where will I put this? Asset account, balance sheet, 372. 372. Clear? Now see, trading account, everything is done. Your only thing is gross profit, and that gross profit will come to P&L. P&L, everything is done. This is net profit. Net profit will go to balance sheet. And in balance sheet, every single thing we have discussed, it should tally. Are you getting this? Done.
Take lot of time to take the problem.
Yeah, but this was big question they will not ask in exam. It will take lot of time. If they ask, this might come for 15 marks. Weightage will be more. Now, any portion of this can be asked in the exam, no? Now, we don't know which portion. A small portion of this, just preparing debtors account, can come for 5 marks. Can come for 4 marks. We don't know. So, this question we have to learn fully so that we know maybe legal expenses are there, what to do. Some place they have told it anticipates defeat, what to do. So, any portion can be asked. Obviously, this big they won't ask. It becomes too much, right? Just to discuss without solving only we took 35 minutes.
Receivable debtors and bill payable account. Possible payment.
There is no format, right? What is the format? Anything can be there, right? Remind me tomorrow. Today I don't think we are running short on time, right? If you finish before 8:30, we'll do it. Otherwise, you remind me tomorrow. Because tomorrow I think we'll finish much before time. Because we are starting at 11, 12, 1, 2, 3. 4 hours are there. We won't require 4 hours. Hopefully. Depends on your company accounts knowledge. Company accounts, anybody skipped company accounts here?
Skip, but units.
Last units and all skipped.
Yeah, last 3 units.
Redemption? You didn't solve. What is this? Okay guys, let's go further. Illustration 9. Illustration 9. This was illustration 10. Let's go into illustration 9. Okay, listen. From the following data furnished by Mr. Manoj, you are required to prepare trading and P&L account for the year ended 31st March 2022 and balance sheet as at that date. All working should form part of your answer. Yes, Charan. Shall we start? Now, what should you do? Can you see in this question, till here, it is opening balance, closing balance. Correct? Now, hello. Yes, opening balance, closing balance. Now, in the opening balance, closing balance also one question mark is there. That means opening balance only is missing. Which ledger? Debtors. Why do we prepare debtors account? To find the balance. In debtors account, what purchase I'll find? Okay, to find the balance. See, he was actually right. Why do we prepare debtors account? In this, we are only preparing debtors account to find the opening balance. Sir, what will happen if I don't get opening balance of debtors? If I don't get opening balance of debtor, you know what will happen? You will not be able to prepare the opening balance sheet. Okay, sir, what will happen if I don't prepare opening balance sheet? Then I will not get the opening capital. What will happen if you don't get the opening capital? You cannot get the closing capital. You will not get the answer ultimately. Clear? Now, you should tell me where it goes. Okay, I forgot completely whatever I solved in the previous question. Now, this is starting of the year. This is ending of the year. Creditors, opening balance, closing balance. Where should it go? Opening balance sheet, closing balance sheet and the creditors ledger. Correct? Now, opening balance sheet. Where have they prepared? Here. Creditors 15,770.
Yes.
That was the opening balance 15,770. And in the closing balance sheet, you should get 12,400. And in the creditors ledger, you should find by balance brought down or creditors only. Oh, balancing figure it seems. They have only given what balancing figure? 15,770, 12,400. Is it clear? Now, sundry expenses outstanding. Where should it be? Opening balance sheet and closing balance sheet first of all. Okay, in the opening balance sheet, can you see 600? And in the closing balance sheet, can you see 330? I should show you first. 330. Then what will happen? P&L, opening outstanding will be subtracted, closing outstanding will be added. Last year's outstanding is last year's expense, so minus this year's outstanding is this year's expense, so add. So in the P&L, sundry expense, they have shown net figure here. Now, I will search for the sundry expenses. Okay, we'll keep it later. We'll keep it pending or remember this later, okay? Now, sundry assets. Assets, yes, where will it be? Balance sheet, opening balance sheet, can you see assets? 11,610. And the closing balance is 12,040. Can you see in the closing balance sheet 12,040? 40 here. Yes. Next, inventory in trade. Opening stock, closing stock. It should be in trading account and the respective balance sheets. So in trading account, opening stock, closing stock, 8040, 11,120. And it should also be there in the opening balance sheet. Opening balance sheet, 8040 and closing balance sheet, 11,120. Clear? Next, cash in hand and at bank. That means we don't have to prepare cash account, bank account separate because cash and bank is given together. So what will you do? Opening balance sheet, you should have cash 6960 and closing balance sheet, you should have over here 8080. Then you should go to the cash and bank account and write 6960 and 8080. Is it clear? Are you following this? Now, debtors opening balance, I don't know. Closing balance, I know, 17,870. That means closing balance sheet, 17,870. And in the debtors account, 17,870. This is not yet found. This will be the balancing figure. And that's why I cannot put it into the opening balance sheet. See, from the total debtors account, I'm getting this. Only after I get that, then I'll be able to get this. Only after I get this, I'll be able to do the closing balance sheet. Clear? Now let's go into the transactions. Details relating to transactions during the year. Cash and discount credited to debtors. No. This is not a nice thing. Cash and debtors together, if it is credited, we don't want. Because for cash, the entry is cash account to debtors. Correct? And for discount, it is discount account debited to debtors. These are two different transactions. So if they are given together, I have to play the waiting game. I have to play the waiting game to see whether somewhere I'll get the breakup of this. Okay? Now, sales return. What is the entry? Sales return. Sales return account debited to debtors. Sales return account debited to debtors. Can you find returns inward? 1450. And where should this 1450 go? It should be subtracted from trading account, from sales. Can you see 1450 subtracted? Yes. Next. Bad debts. What should be the entry? Bad debts account debited to debtors. That means should I find it in P&L? Yes. Should I subtract it from debtors? Yes. So can I find it in the debtors account on the credit side? Yes. Are you following this? No. Yes, sales, cash and credit. Again, I cannot do anything. I have to play the waiting game. Why? Because cash sale entry is cash account to debtors, credit sale entry, cash account to sales, and credit sale it is debtors account debited to sales. I cannot post these entries. So two things have remained pending. This one and this one. Clear? Huh? Trading you can put. But trading also, they have put the breakup, I think, no? Trading you can put. 71,810 and I'll get the net amount also. Okay, but I can't close the cash account. I can't close the debtors account. Yes, next. Discount allowed by trade creditors. What should be the entry? For us it is discount received. Discount allowed by trade creditors. That means it is creditors account debited to discount received. Creditors account debited to discount received. Can you see 700? But this 700 also should play a double role. Where should it go? P&L. In P&L, can you see 700 on the credit side? Yes. Next. Purchase returns. Purchase return. Purchase return. Creditor account debited. You were telling creditor only. Okay. Creditor account debited to purchase return. How much? 400. Creditor account debited to purchase return 400. And what should be the other effect of this?
Trading.
Trading. Yes. That is trading. 400. Correct. Next. What next? Additional capital paid into bank. Bank account debited to capital account. Bank account debited to capital account. Can you see 8,500 over here? And what should I do? Add it to the capital. I don't know the starting only, but I know I have to add 8,500. Next. Realization from debtors paid into bank. Now we know the breakup. Realization from debtors paid into bank. How much is the amount paid into bank? 62,500. What should be the entry? Bank account debited to debtors. So can you see 62,500 bank account debited and debtors account 62,500. Now I got to know that means 1500 is discount. 1500 is discount. Entry for discount allowed. Discount allowed account debited to debtors 1500, and this should also go into my P&L, and in my P&L I can find discount of 1500. Is it clear? Next. Cash purchases. Purchase account debited to cash account. Purchase account debited to cash account. So in my cash account I should see 1030. Can you see purchases here? 1030. It should go to one more place. Trading. Trading account, can you see 1030 is added to purchases? Okay, next. Cash expenses. Expenses account debited to cash. Expense account debited to cash. Go to expenses and go to cash and see. Can you see expenses here? 9570. Is it matching with 9570? Where should this go? 9570. Yes, it should go to P&L. How much it should go to P&L? No, because we have outstanding expense over here. 9570. Last year's outstanding minus this year's outstanding plus. That gives you 9,300. Yes, where should it go? P&L. In P&L you should find 9,300. Are you finding it? Yes. In hurry, you don't forget that outstanding is also there. Directly put 9,570. You will not realize now. You will realize when balance sheet doesn't tally. Are you getting my point? Any mistake you won't realize, no, you will get to know only when balance sheet doesn't tally. So now let's go further. Paid by check for machinery purchased. 430 rupees machinery. I think calculator only. 430 rupees. Tell me what should be the entry. Machinery account debited to bank account. In bank you should find 430, and you should hope that there is no depreciation, because if you see over here, you already know the value of machinery. Sundry assets 11,610 became 12,040. Can you see the difference is 430? Can you see the difference is 430? If the difference was something else, that means there might be some depreciation. Clear? Yes. Charan, let's continue. Huh? Machinery purchased. Unit number 1, capital and revenue expenditure. Okay. Battery power saving mode is getting over. Let's continue fast. Household expenses drawn from bank. Drawings account debited. Yes. To what? Bank. Yes. Bank. Drawings account debited to bank. How much is it? 3130. 80. Yes. 3180. It should also be subtracted from capital in the balance sheet. 3180. Hello. Here. What about let it get empty? No problem. Cash paid into bank. Bank to cash. Cash drawn from bank. Cash to bank. We don't have to pass these entries because we are doing cash and bank together. But I see jobless, right? When they are printing, they have a lot of time. 9240, 5,000. When the ledger only is cash and bank, why to pass these entries? You can avoid this also in the exam. Okay. Next, after this, cash in hand. I don't need cash in hand because I already know cash and bank together. What is the balance? 8080. I don't need cash separately, so you can just ignore that. Checks issued to trade creditors. Checks issued to trade creditors. Creditors account debited to bank. Creditors account debited to bank. Check your creditors. 60,270. It was 60,270 here to bank. Now bank you should have 60,270. Is it there? Yes. Done. Finished. Question is done. Now you have to ensure that you have to do everything. Here sales is still standing hanging like this because we don't know the cash sale. Oh, sorry, we know the cash sale, is it? No, we don't know cash sale also. We don't know credit sale also. We only know total. If you find one also, you'll be able to find the other. Now if you notice over here, in the cash and bank account, missing figure is cash sale. Balancing figure. Missing figure is cash sale, 4,600. And in your debtors account, debtors account missing figure is credit sale. No. Debtors account missing opening balance. So why we found cash sale? Because using the total sale, I can find the credit sale. Using the total sale, I can find the credit sale. So cash sale we found 4,600. That means in debtors account, I can write the, where is debtors? Yeah, debtors account, I can write the, see 71,810 minus 4,600. I got my credit sale. When I get my credit sale, I'll get my opening balance. When I get my opening balance, I can go and put it to opening balance sheet. When I get the opening balance sheet, I can get the opening capital. When I get the opening capital, I can go and put it to the closing capital. Can you see the interlink of all these things? Yes. Now, debtors closed, cash and bank closed. What about creditors? It will give me my credit purchase. I only know the cash purchase over there. Okay, credit purchase. Where will I put this credit purchase? Straight into trading account, 58,000. See, 58,000. Now I got the total purchases. Sales I already knew. After that, cash closed, creditors closed, debtors closed. Now, nothing. You will get the gross profit, put it here. You will get the net profit, put it here. And your balance sheet has to tally. Done, finished. Small question, right? Is it clear? Yes, let's proceed. Next question that we have to solve is SM practice question number 2. SM practice question number 2. Yeah, small question. Oh, very small. Okay, guys, let's start. Look at this question. Mr. A runs a business of ready-made garments. He closes the books of accounts on 31st March. Balance sheet is given. What is this balance sheet? Opening balance sheet already given. Half year work done. Okay, you don't have to prepare opening balance sheet because capital we already know. 4,04,000. What will I do with this capital? Good morning. What will I do with this capital? I'll go and put it to closing balance sheet and I will write 4,04,000 starting point for me. Clear? Creditors is there over here. Where will I put this creditors? Go to creditors account and write opening balance. Balance brought down. Then what? Already from liability side only I picked it. Again, which liability side I will put it? From liability side only I picked it. And I am going and putting it in creditors account. Usually we used to prepare opening balance sheet. Now opening balance sheet is given. Now using that we'll start our other ledgers. Clear? Now furniture, I don't need, just keep it. In fact, if you have to calculate depreciation or something, we'll require that. Stock, where will I put this? Opening stock, yes, where? Trading account, yes. Trading account. Okay, opening stock 2,80,000. Clear? Next, we have debtors. Debtors account. Go to debtors account and write. No, debtors account only. Very good. Here. There is 1 lakh. Debtors account 1 lakh. Clear? Next, cash in hand, cash at bank. Where will you put it? Bank account, opening balance, cash account. Where are you? Oh, see, I say, right? They don't know. They're like, why to every time prepare ledger? We'll prepare a statement this time, opening balance. Okay. No, cash statement. Cash account, instead of preparing, quietly they could have prepared ledger, no, for cash. They're like, why every time ledger? Why should ledger have all the fun? We'll prepare statement. Is it clear? So they prepared statement. Is it clear? Now statement also, plus minus you will be doing there also. Now done. You are furnished with the following information. Yes, Sharon, let's continue. They are not in bank to prepare bank statement. Bank statement, bank will prepare. Okay, now. What? Still they will only give me the statement. If I borrow, I will prepare statement. Bank will give no. Yes. His sales for the year ended 31st March 2022 was 20% higher than the sales of previous year. Out of which 20% was cash sales. Total sales during the previous year was 5 lakhs. What did they tell? Last year, whatever sales are there, we made 20% more than last year. Do you agree with that? Plus 20%, that makes it 6 lakhs. Is 6 lakhs your sale? What is this sale? No, total sales. This is your total sales. Now out of the total sale, how much is cash sales? How much is cash sales? 20% is cash sales. So 1,20,000 is cash sales. Okay, that means 4,80,000 is credit sales. Clear? What is the entry for cash sales?
Cash account debit.
Cash account debited to sales. Let's find in the cash sales. Can you see they have added 1,20,000? And then you should take it in sales also. So in trading account, you should find it cash, credit. Can you see the total sales here? Yes. 4,80,000 should go where? Credit sales, entry, credit sales, entry, credit sales, entry. Debtors account debited to sales. Debtors account debited to sales. Clear? Now, payments for all the purchases were made by check only. Payments for all purchases are made by check only. How much they paid, we don't know. They told everything is paid by check. So whenever you find it, it is creditors account debited to bank. Goods were sold for cash and credit both. Oh, we didn't know it. In first point, you didn't tell us. Now we got to know. Okay. Credit customers also pay by check only. Okay, pay by check only. So whenever we get the information about how much they paid, that is by check only. Bank account debited to debtors account. Depreciation on furniture is to be charged at 10% per annum. How much is the furniture here? 40,000. So 10% means 4,000 depreciation. So in your P&L, you should find 4,000 depreciation. 4,000 depreciation. And in your balance sheet, asset should become 36,000. Clear? Next. Mr. A sent to the bank the collection of the month on the last day of each month. He is sending to the bank collection on the last day of each month. After paying salary of 2,000 to clerk. It's not 2,000 per month. It is 2,000. So directly 2,000 will be taken as salary in the... Oh, it's per month only. Oh, sorry. My bad. They said send to the bank at the end of each month. No. Can you see here? Send to the bank collection of the month at the last day of each month. So it is into 12 only. 2,000 into 12. Can you see it becoming 24,000 in P&L? And you should also put it into bank account or cash account. Cash account, because after paying this, he is sending to the bank. So in cash, not the account, the statement, can you see minus 24,000? Clear? Next. Then office expense 1,200. 1,200 into 12 is 14,400. 14,400, can you see minus over here? And you should also find it in P&L 14,400. They didn't prepare cash account. They prepared cash statement. Okay. Now, after that, personal expense of 500. Drawings account debited to cash. That means you should find drawings subtracted over here. 12. 500 into 12. It should be subtracted. And in cash, you should find the minus of 6,000. Clear? Next. Analysis of bank passbook. See man, they only prepared the statement. Bank passbook for the year ended disclose the following. Okay. Payment to creditor. Entry. Creditor account debited to bank. Can you see in bank over here 3 lakhs? And in creditor account, can you see to bank 3 lakhs? Clear? Next. Payment of rent up to 31st March 2022. No problem. Till the end of the year you have paid. Rent account debited to bank account. In your bank, can you find rent here 16,000? Then P&L. Go to P&L and search for rent. Is it there? 16,000. Clear? Next. Cash deposited into bank during the year.
No, bank.
Bank account debited to cash account. Bank account debited 80,000 to cash. So here you have to minus 80,000. Clear? Next. The following are the balances on 31st March. End of the year balances. Stock. What will you do? Closing stock. It will go to trading account, and also to balance sheet. Clear? Next. Debtors. Closing balance of debtors. What should be the effect? Debtors closing balance should go to closing balance sheet and also to the debtors closing balance. That is balance carried down. Clear? Next. Creditors. Creditors. What? Debtors? No, I didn't get it. We put no. See? Okay. Creditors. What about creditors? 1,46,000. It should be there in the balance sheet. 1,46,000. And creditors account closing balance 1,46,000. Then, on the evening of 31st March 2022, the cashier absconded with the available cash in the cash book. Very good. He thought, end of the year, who will write balance carried down and all? Let's make this balance carried down from here go away and let's make it balance brought down for us, for our personal. So, luckily this fellow deposited here 80,000. Luckily this fellow deposited into the bank 80,000. Otherwise, this also would have been gone. Correct? On the evening of 31st March, cashier absconded with the available cash. That means nothing can be there in cash balance. So whatever balancing figure is there in cash balance, that is gone. That is why, can you see over here the statement, last you have 23,600. This is gone. That means it is gone means how will you remove it? It's a loss or profit for you? Loss. Loss should go to P and L. In P and L you should find 23,600 loss of cash. Is it clear? Now, done. Question is done. Now if you see your creditors account, balancing figure is what? Purchases. Balancing figure is purchases. Go and put it into the trading account. Purchases 3,64,000. Your debtors account, what is the balance? Sales is already there. We already calculated starting itself sales. Balance is amount received. Amount received 4,60,000 balancing figure. That you'll go and put it over here. That time you'll get the closing balance of bank, because when they told all the closing balances, stock is there, debtor is there, creditor is there. Is there any bank? No, bank we have to find. Is there cash? We have to find, but that is gone. Are you getting this? So when we put the amount received from debtor, which we got from the debtor's account, that time you got the balancing figure over here in the bank account. Is this clear? Are you following this? Where will this balancing figure go? Where will this balancing figure go? Balance sheet, yes. 2,62,000. After that, nothing. Done. Trading account, you got gross profit, that went into P&L, and here you got net profit, that got into balance sheet, and balance sheet will tally. Clear? That is it with that particular question. We have one more question. Last question from incomplete records. And probably last question for the day. Okay, practice question number 3. Practice question number 3. Teacher. ದೊಡ್ಡದು ಯಾವ ಚಾಪ್ಟರ್ ಅಲ್ಲಿ? NPO, that school.
Seminar, conference.
That in that everything is small only, man. Only thing is too many things in the trial balance. Only thing is you have to find that profit of that stores. We'll see tomorrow if we get time. Third PQ. Third PQ, little is there. Okay. Last question for the day, guys. No. Have a look at this. Ram carried on business as retail merchant. He has not maintained regular account books. However, he has always maintained 10,000 in cash. He has always maintained 10,000 in cash. I didn't understand one thing. If mother is calling, why is she taking the water bottle and going? Okay.
Mother. Sorry.
Yes. In cash and deposited the balance into bank. That means always the person is going to maintain 10,000 in cash. Is it clear? He informs you that he has sold goods at profit of 25% on sales. He has sold goods at what? Profit of 25% on sales. Now tell me one thing. Listen. Here again, get ready. 10,000 should always be in cash, right? Can you see the cash? 10,000. That means opening balance sheet should have 10,000 cash. Closing balance sheet should have 10,000 cash. Is that correct? Okay. Now can you see opening balance sheet is also prepared. But where is it prepared? Yes. Oh.
Trading minister.
That is closing balance sheet. They are not prepared opening balance sheet, right? Oh, wait. Why they didn't prepare is because already capital is given. Ram's capital 3 lakh is given. That's why no need to prepare opening balance sheet. Straight away you can go to closing balance sheet and write opening capital of 3 lakhs. Cash in hand you can write 10,000. Only closing figures you can write. And the 10,000 should also be there in cash account. Opening balance 10,000. And closing balance 10,000. Clear? Now what about creditors? Opening balance, closing balance. Opening balance 40,000, closing balance 90,000. Clear? And that should go to only closing balance sheet because opening balance sheet we are not preparing. In closing balance sheet we'll put 90,000. Is this clear? Why are we not preparing opening balance sheet? Because the main reason for preparing is gone. Okay, capital is given. Next, cash at bank 50,000 credit. That means OD. So when you are seeing cash at bank, can you see over here buy balance brought down? And end of the year 80,000 debit. Starting of the year we were in credit balance. We had taken more money, but end of the year we met some friends. We got money, now 80,000 debit. Okay, so now 80,000 debit means it should also be buy balance carried down. What is this, sir? Buy balance brought down is also on same side. Buy balance carried down also on same side. Because starting it was liability, that's why it was there. Ending it is asset. So from here it will go to this side. Don't worry. Is this clear? And that 80,000 should go to closing balance sheet. 80,000 cash at bank. Next, sundry debtors, opening balance and closing balance. Closing balance should also go to closing balance sheet. And debtors account, opening balance, closing balance, both are there. Yes, hello, good morning. Next, stock, where should I put the stock? Only opening stock, other than that some question mark I can see. So I don't know the closing stock. Okay, fine, no problem. Stock I know, opening stock, something is better than nothing. So I'll put the opening stock 2,80,000 and I'm not preparing opening balance sheet, so ignore the opening stock. Closing stock, somewhere someone, God will give some clue, we will find it. Okay, now analysis, gross profit rate is given. Okay, that is why it was given the gross profit rate. Analysis of bank passbook reveals the following information. Done now. I can continue now. Yes. Analysis of bank passbook reveals the following. Payment to creditor. Creditor to what? Creditor to what? Bank. Why? Bank passbook they are giving you information. Creditor account debited to bank account. Go and find your creditor. Creditor account debited to bank account. Can you see bank column 7 lakhs is there? Yes. Next, payment for business expenses. Expense account debited to bank account. Can you see 1,20,000 is there? And this expense is feeling very restless. It has to go somewhere else also. Where is that? P&L. 1,20,000. If outstanding was there, we should have adjusted. Next, receipt from debtor. Receipt from debtor. Bank account debited to debtor's account. Bank account, can you see in the bank account there is 7,50,000 and it should also go to debtor's account 7,50,000. Are you following this? Next. Loan rupees 1 lakh taken on 1/10/2021 at 10% per annum. Why they give that date and all? Because when loan is taken, interest is supposed to be paid. Okay. Only sometimes we get interest free loan. 1 lakh loan taken. What should be the entry? Bank account debited to loan account. So first you have to find over here bank account debited to loan account 1 lakh. And this loan should be shown in the balance sheet. Can you see on the balance sheet liability side? Can you see loan here including interest they have written? So let's calculate the interest also. 1 lakh rupees loan 10%, but I will pay only 6 months interest because I borrowed it at the beginning, at the middle of the year, 5,000. That makes it 1,05,000. And that 5,000 rupees interest should also go to P&L, 5,000 interest on loan. Clear? Next, cash deposited in the bank. Entry. Bank to cash. Yes. What should be the entry here? Bank account debited. Cash account. Either side you should find it. Clear? Next. He informs you that he paid creditors for goods 20,000 in cash. Creditors you paid 20,000 in cash. No. Creditors account debited to cash account. Creditors account debited to cash account 20,000. And salary is 40,000 in cash. Salary account debited to cash account. So you can see over here cash 40,000. Where will that P&L? It will go to P&L 40,000 salary. No outstanding, nothing. Next, he has drawn 80,000 in cash for personal expenses. Drawings account debited to cash. So you should see 80,000 over here. And in balance sheet, we are going to subtract from capital 80,000. Clear? Next, during the year, Ram had not introduced any additional capital. Very good. Okay. Surplus cash, if any, to be taken as cash sales. If you find any balance in the balancing figure in cash, it should be taken as cash sales. All purchases are on credit basis only. So now, understand this. Using the debtors account, we can't find anything. We can find only credit sales. Balancing figure, everything is there, no? Credit sales. Credit sales, where will it go? Trading account, you will write credit sales 10 lakhs. Clear? Then, using the creditors account, what will we find? Purchases. It is not only credit purchases, it is my total purchases. Why? Purchases are all credit only. So 7,70,000 directly you will put it to trading account 7,70,000. Clear? Then when we go into our next thing, cash and bank account. Cash missing figure is what?
Cash sales.
Cash sales. Cash missing figure is cash sales. It will get added to our sales. Okay? In the trading account. Now you got your total sales. Now, bank, what is the missing figure? No missing figure, if you notice. It will automatically match with the balance. If there is missing figure, you are clueless. What will you take it as? Payment to creditor is told. Receipt from debtor is told. Cash sale is already through cash. What will you take it as? Are you getting this? All the bank transactions were correctly told. That's why it is matching with the balancing figure. So there is nothing missing over here. 80,000 I did not get. It was given in the question. Are you getting this? So not necessarily that every time something should be the balancing figure. Now, everything is done now. What is missing now? Closing stock is missing. You know sales. You know sales. You know gross profit. Using gross profit, can you find gross profit itself? Yes. So now, sales into gross profit percentage will be your gross profit. Because usually gross profit was your balancing figure. Now you found a way to calculate gross profit. So closing stock is your balancing figure. Where will this closing stock go? Straight into the balance sheet. And gross profit will come to P&L and you will get net profit. Net profit will get added to balance sheet and then you will get your balance sheet. That is it with incomplete records. Clear? You should have the capacity to keep everything open. You should not start by one. It's not going to work out. You're going to take forever. Everything open. It might run into 2-3 pages in your answer book, but it's okay. Everything should be open as you read, like how we did. We should finish the entire solution. Clear? Yes, guys, that's it for the day. See you tomorrow. Only one chapter remaining, that is company accounts. Bye-bye. Yes, let's begin. Company accounts, small chapter, guys. It's asked in the exam for little marks. Little as 25. Okay, only 25. 25 marks, that's almost 1/4 of your paper. I mean, almost what? 1/4 only of your paper it is. Paper comes out 120. Paper is always out of 120 marks because one extra question will be there. But 25 marks is huge. You get this right, it's almost like the goal is set. Okay, and trust me, it is not difficult. Okay, company accounts is actually easier compared to all the other things that are there. Okay, let's begin. First, issue and forfeiture of shares we'll discuss. Issue and forfeiture of shares. First of all, what is a share? What is a share? Share is a share in the share capital. Beautiful definition of company law. Share is a share in the share capital. Basically, it's just a small portion. See, total amount invested by owner. Can you be the only one and only owner? No, then it becomes 1% company. So, small portion of whatever you are going to take of the ownership, that is called as share. Okay, if you go and buy today in the stock market, you go and buy Infosys shares, then you will also be called as owner of Infosys. But are you going to go to Infosys AGM and take all decisions on your own? No, because you have only small share of it. Okay, types of share. Types of share, what do we have? Preference share and equity share. What is preference share? Share that has preferential right. Preferential right means what? They have first preference. First preference for what? One, dividend. Another, repayment of capital. When in case of winding up only. Not when the company is running. In case of winding up. What is equity share? Beautiful definition again. Any share other than preference share. Okay, so preference share is defined in company law. Equity share isn't. Okay, now different stages of share capital. First, authorized capital. What is authorized capital? This is the maximum that you can ever issue. The company cannot issue more shares than this. This is the total limit set. Maximum capital that can be raised by the company. Issued capital. What is issued capital? Shares issued to public out of the authorized capital. How much is given to public or offered to public out of the authorized capital? Whatever is offered to you, do you think you'll eat everything? No. Subscribed capital. Shares subscribed by public out of shares issued. Called up capital. Company wants money, but do you think they want all the money at this point of time only? No. They will ask only little at this point of time, and that is called as called up capital, amount asked by the company at this point of time. Clear? What is paid up capital? Whatever company has paid, if at all somebody has defaulted, there will be a difference. So what company has asked is called up capital. What shareholder has paid is paid up capital. Clear? Next, accounting for issue of shares. I know you have buyouted this in few 8 entries. Okay, you're not going to buy out. You don't know. No, but you don't know how these people have buyouted in few. Okay, these people literally in few, right? 8 entries they have buyouted. They have no head or tail about why the entry is passed. They buyouted 8 entries. Amounts they took it as fill in the blanks, filled it, got the full marks, and they came. They had no clue what is happening over there. Okay, so application stage first. What is this? A share, when company is issuing, they'll issue it in parts. Parts means what? Share is issued at once only, but they're giving the option to the shareholder, telling that you don't have to pay the entire amount now. Pay little on application, then little on allotment, and then you will pay it at call. Call can be 1, 2, 3, 4, how many ever calls can be there. Clear? But once you finish paying everything, that means your limited liability is done. Your limited liability is only till the unpaid amount of the share is there. Once you pay everything, then there is no liability at all. Then I can't ask the shareholder to pay anything. Clear? Now, application stage. At application stage, what happens? What happens at application stage? Whoever is interested, they'll pay the money and show their interest. So the entry should be bank account debited to equity share application. On what date you will pass this? Date of receipt of application amount. Clear? Now, after that, there can be a situation here, something called as oversubscription or under subscription. Yes. Yeah. So application stage, what happens? Whoever is interested, they show their interest. Okay. Now there can be a situation that there is oversubscription or under subscription. So once you receive the application money, there is no guarantee that you are going to be given share as a shareholder. So when it is confirmed on the date of allotment, so therefore your next entry is to transfer the money to share capital, and that is happening on the date of allotment. So when you transfer, what happens? Equity share application account debited to equity share capital. Now why is this their bank account debited? Because asset increases debit. Why is this credited? I received the money, but I have not given anything in return to them. That means it's a liability to do something or give something. Liability increases credited. When you actually give them, what are you giving them? You are giving them share. So here liability decreases and the share capital is also a liability increases. Then allotment due entry. Allotment stage due entry. What is the entry? Now bank doesn't come first because now you know who the shareholders are. Now you start asking them money at every stage. When you ask them the allotment money, what should be the entry? Equity share allotment account debited because it is receivable to equity share capital. Now, why are you transferring the money to share capital even before you receive? Now you know who the people are. So you just transfer the money to share capital. When you get it, bank account debited to equity share allotment. Same process will be followed for call as well. You ask them the money, so receivable, equity share call account debited, and you transfer it to share capital. And when you get the money, bank account debited and the receivable is gone, so equity share call account. You can have first call, second call, whatever number of calls, but the entries will remain same. This is when shares were issued at par. Par means what? At face value. Now if shares are issued at premium, premium means what? Issued higher than the face value. If it is issued at higher than the face value, then two things can happen. Premium is collected at application stage itself, or premium is collected at allotment or call stage. Simple. Remember this. Whichever stage it is, when you are transferring the money to share capital, no. That time you transfer the money to securities premium as well. Okay, when you transfer to share capital, transfer to securities premium. If it is at application stage, the first entry is not transferred to share capital. Second entry is transferred to share capital. So here, bank account debited to equity share application, including the premium amount. Then when you transfer to share capital, equity share application account debited to equity share capital to securities premium. Clear? Now, at allotment stage or call stage, first entry only is to transfer to share capital. So equity share allotment or call account debited to equity share capital to securities premium. Now you remember one golden rule. Always equity shares, preference shares, debentures, only face value. That means it will be recorded only at face value. Whatever you might have issued it at doesn't matter, but it will have only face value. Clear? Extra amount goes to securities premium. So now when you get the money, bank account debited to equity share allotment or call, already premium is included in that. Next, shares issued at discount. If share is issued at discount. Now tell me, if share is issued at discount, what should be the entry? No entry, because it is not allowed. Debenture can be issued at discount, but share cannot be issued at discount. It is prohibited except for sweat equity shares. Sweat equity shares are usually shares given to employees, and that is not part of a syllabus, so you don't have to worry. So in your syllabus, you can't have any situation where they are asking you to issue shares at discount. Now you are like, sir, wait. When we are reissuing the share, I remember seeing that shares are issued at 7, 8, 9 and all. Isn't it shares issued at discount? No. It is not issued at discount. It is issued at face value only, or more than that. Because what happens in reissue, share was over here, this fellow didn't pay, but he paid some amount. That same share goes to another person's hand. Now whatever he has paid plus whatever this fellow has paid, that will match up to the face value. Clear? So shares are never issued at discount. Okay. Now, under subscription. Under subscription means what? Less than the shares issued. You got less shares than what you had actually issued, but company law has given 1%, that is 90%. Minimum subscription is 90%. If you get anything below 90%, 100% of the amount you have to refund. You can't keep any amount in your pocket. All the amount you have to refund if you get anything below 90%. So, if it is below 90%, refund. For refund, what should be the entry? Application gone. So, equity share application account debited to bank. Clear? Oversubscription is another important player here. Oversubscription. What is oversubscription? You got more shares than what you actually asked for. Now, can you tell that I had planned to construct one floor factory. Okay, so I am issuing shares. Suddenly I got too many applications. I'll construct 3 stores. Is it possible? No. Because when you are issuing shares, debentures, anything, you always issue something called as a prospectus. In that prospectus, you have promised them that this is the amount I need. And this is what I'm going to give you back. So whatever I need, that only I can utilize. Suddenly when I'm getting more or less money, I cannot change my plan. So if there is oversubscription, shares subscribed more than the shares issued, you have 3 options. 1, reject and refund excess application. Whatever extra is there, reject and refund. Then pass the entry equity share application to bank. Clear? Or you do pro rata allotment. What is pro rata allotment? You don't want to make anybody unhappy. You give shares to everybody. But what they asked, you are not giving that. Clear? What they are asking, you are not giving. You are giving in the proportion of what you can give. Imagine you had issued 1 lakh and you got 3 lakh applications. Now can you give shares to everybody? No. What you will do is for every 3 you will give 1. That means for every 3 you will give 1. Now tell me one thing, in this case, the person has given application money for 1 lakh or 3 lakh? 3 lakh. So if you are giving only 1 lakh shares, that means that extra 2 lakh applications money is remaining with you only. You can do 2 things with it. Now, excess application money can be adjusted with allotment or call, or balance you can refund. Now, if they tell call, do it. Otherwise, only till allotment and extra money you refund it. Because usually application and allotment is very close to each other. Application money received within 1 month we decided and we are giving the shares. But call amount is not close to each other. No, call can be after 1 year also sometimes. So therefore, unless they tell you in the question, don't adjust it with call, adjust only till allotment. Extra money, whatever is there, it has to be refunded. Clear? Shares are issued to everyone, but not how much is asked by the shareholders. That is pro rata allotment. Can you do a combo of both? Some are rejected, some are pro rata. That is partly reject and partly pro rata. Clear? Next. Yeah.
not in the application money with the allotment money, they can give interest, they need to give interest or
No, we don't have to give interest here. This is not calls in advance.
not mandatory or
It's not mandatory, but if they wish to give it, you can give, but it's not mandatory. Only in calls in arrears and calls in advance, usually interest factor comes into picture. Okay. Now, calls in arrears is what? Somebody had to pay the money, did not pay the money. That means for me it is asset. So, amount unpaid by the shareholder after call is made by the company. Here, interest on calls in arrears, you have to pay or you have to get. You have to get. Maximum is 10%. Maximum is 10%. Clear? Equity shareholder account debited to interest on calls in arrears. Why equity shareholder is debited? Because it is receivable. Why interest on calls in arrears is credited? Because it is income. Clear? Next, when you get it, bank account debited to equity shareholder. Then income should be transferred to P&L. So interest on calls in arrears account debited to P&L. Is it clear? Now next, interest to be charged from the last date for payment till the payment is actually made. From when to when you have to charge interest? This timeline. Have a look at this timeline. This is the date of call. This is the date of call. This is the due date for payment. Now when they make the call, will they tell by today evening you have to make the payment? No. They will give you time till some day. This is the due date for payment. Now due date for payment from here till here. From here till here. From the due date of payment till the date of actual payment, interest will be charged. Is it clear? Now next we go into calls in advance. Calls in advance means what? Good boy. Okay, paid the money early. Actually bad boy for us. You know why? Because that guy is good. For us it is bad. We have to pay interest now. Clear? In calls in advance, liability, amount paid by the shareholder before call is made. We asked only for allotment money, but that fellow has paid first call and final call also. Clear? Now, interest on calls in advance, maximum is 12%. Maximum you can pay is 12%. Now, interest on calls in advance, expense or income? Expense. Interest on calls in advance is debited because it is expense, and equity shareholder is credited because it is payable. Because it is payable. Next, equity shareholder account debited to bank because it is paid. Expense should be always transferred to what? P&L. So P&L account debited to interest on calls in advance. Clear? Next, interest to be paid from the date amount is received till the date the call is actually made. This timeline becomes important. When did you receive the amount? Here. When did you make the call? Here. So from you have paid so much early. Whatever early period is there, for all this period you are supposed to pay interest, and the maximum is 12%. Clear? Next, forfeiture of shares. What is forfeiture of shares? Cancellation of shares. For what reason? For non-payment of amount called. I asked the amount, that person hasn't paid it, so you're going to cancel the shares. Now, if shares are issued at par, then it is pretty simple. When you are cancelling, you are removing the person from owner position. Therefore, equity share capital account debited. Debited for what value? Not the face value. Don't always come to the conclusion that it is face value. Amount called up only. Only the amount called up. Clear? Now 10 rupees share, only 8 rupees might have been called up. So 8 rupees is transferred to share capital. Remove that 8 rupees. Okay. Called up value. To share forfeiture account. If he has paid some amount, we are not going to refund that money. That is profit for us. That is why it is transferred to share forfeiture account. Now, is it possible that a person has not paid anything and his shares are cancelled? But because at least application they have to pay to enter the story. Correct? So, profit. To equity share allotment or call account or calls in arrears account. You have to see whether the company has opened calls in arrears or the unpaid amount is still sitting in those respective ledgers only. Okay, either this or this you are going to do. Calls in arrears is only if it's told in the question. If they tell in the question calls in arrears account is open, then use calls in arrears, otherwise it will be in the respective call accounts only. This is the amount unpaid. Is it clear? Now, the critical part of forfeiture is, what if shares are issued at premium? If shares are issued at premium, you have to think whether premium amount is received or premium amount is not received. If premium amount is received, then it is sitting in securities premium. Let it be there only. Don't go to touch it. Let it be there itself. Don't go to reverse premium. Ignore the premium. By ignoring premium, you will pass the entry as if shares were issued at par. Ignoring premium means you will pass the forfeiture entry as if the shares are issued at par. So equity share capital debited, only face value. Share forfeiture account, only face value. Equity share allotment or calls and arrears, only face value. Full entry will be only for face value. Are you getting this? If shares are issued at premium also, let's say 10 rupees share is issued at 12 rupees and this 2 rupees is at allotment stage. Allotment money is 3 plus 2.
All the equity share capital, is it face value?
In that amount called up, premium can be there, no? Everywhere only face, see, here premium cannot be there because it is equity share capital. Equity share capital, how can premium be there? It will be called up value. Okay, now, share forfeiture account, allotment account, calls and arrears account, everything. Okay, now listen. Application 2. Allotment 3 plus 2. Call 5. What does it mean? 10 plus 2. I am telling you somebody has not paid allotment. Sorry, somebody has not paid call. He has not paid call. Now, entry will be what? Equity share capital account debited how much? 10. Equity share capital debited 10. To share forfeiture. What has he paid? Has he paid application? Has he paid allotment? How much has he paid?
5.
This 2 you are going to ignore. How much has he paid? Only 5. That is what I am telling. Only face value you will focus. You will ignore that premium altogether. Because premium amount is received and premium amount is sitting in securities premium. So you don't have to do anything. Let it be there itself. Is it clear? So equity share allotment or calls and arrears, whatever it is, but only the face value part. You are completely going to ignore the premium. But what if premium amount is not received? Reverse the premium. If premium amount is not received, reverse the premium. If premium amount is not received, is it sitting in securities premium? Yes. What? No. Yes. In due entry only you will transfer it to premium. If premium amount is not received also it is sitting in securities premium. If premium amount is received also it is sitting in securities premium. If premium amount is received and it is sitting in securities premium, no problem. But if premium amount is not received and it is sitting in securities premium, that is not right. So remove the securities premium. So therefore, premium amount is not received, reverse the premium. That time you will pass the entry equity share capital debited, amount called up, securities premium debited, premium amount not received, to share forfeiture, amount received, and equity share allotment or call, and whatever it is, everything is including. Now you are going to think of 12 rupees as the share price and not the 10 rupees. Clear? This is the forfeiture. After forfeiture, what are we going to do? Reissue. The shares, can it be reissued always? Yes. Should it be reissued always? No. Okay, there is no compulsion like that. It is optional. Reissue of forfeited shares is optional. Company can resolve to not reissue shares. Company can pass a resolution telling that I don't want to reissue the shares at all. Clear? When you reissue shares, what will you get? Money. Okay. Now tell me, what is the minimum amount at which the share must be reissued? Simple. Same share is going into one more person hand. Previous person did not pay something. Next person has to pay that. That's all. Minimum amount is previous person what he has not paid. Next person will pay it. Out of the face value. We are not worried about the premium part. Only the face value. Amount unpaid by previous shareholder. Okay. Example you see. Face value 10. Share forfeited for non-payment of first call. Non-payment of second call. Therefore, minimum reissue price should be 6 rupees. 4 plus 2, 6 rupees. Clear? Bank account debited for amount received. Then, if you reissue it at 6, face value is 10. Can you see that there is a loss of 4 rupees? Loss will be debited to share forfeiture account. Face value minus amount received. Now, how are you bearing this loss? Because when you forfeited, there was a profit sitting there. Because of that profit, you are able to bear the loss. Clear? To equity share capital, face value. If at all you issue it at not 6 and if you issue it at 13 rupees, are you going to get a premium here? Yes, it will go to securities premium account. Can we have both this? Share forfeiture also, securities premium also? No. Either you are issuing it at less than face value, then there will be share forfeiture, or you are issuing it at more than face value, then you will have securities premium. Is it clear? Yes. If shares are forfeited and reissued, now understand, the full cycle has to be completed. What is the cycle? Shares should be forfeited and it should be reissued. forfeited, and it should be reissued. Only forfeited, we are not going to talk about this part only. If it is forfeited and reissued, and still some money is there in the share forfeiture account, that will be transferred to capital reserve. It will be transferred to capital reserve only if it is forfeited and reissued. If it is only forfeited, no. Balance in share forfeiture account must be transferred to capital reserve. Entry will be share forfeiture account debited to capital reserve. Is this clear? Any doubt with this? Okay, now share forfeiture account debited to capital reserve. How will you do it? First you will check when you forfeited how much profit you got, 4 rupees per share. When you reissued how much loss you got, 1 rupee per share. So therefore 3 rupees per share will be transferred to capital reserve. Why not P&L? Why not general reserve? Why capital reserve?
Usage should be limited, so we cannot use it for any purpose.
Our usage is limited. That's one of the reasons. It is part of the capital. Yes. And it's a capital profit. It's a capital profit. P&L and general reserve will have your day-to-day business activities ka profit. It will not have these kind of things. And this is not recurring in nature. It will not happen every time. Once in a lifetime of a company, you will have a situation of forfeiture maybe. Or some companies, there will never be a situation of forfeiture itself. So it's a capital profit. That's why it will go straight into capital reserve. Is this clear? Now, shares issued for consideration other than cash. That means what? You are issuing shares, you are not getting money. Maybe you are getting land and building, plant and machinery, something you are getting. Clear? Asset account debited to equity share capital. Here you would have written bank account debited. There is no bank because you are not getting money. Asset account debited to equity share capital. If it is issued at higher price, it will also go to securities premium. Now, how to compute number of shares issued? Asset value divided by issue price, not face value. Asset value divided by issue price. That means if I have an asset 12 lakhs, plant and machinery is 12 lakhs, and I am issuing share at 12 rupees, but face value is 10 rupees. If I write over here 12 lakhs divided by 10, I will end up issuing 1,20,000 shares, which is wrong. I should do 12 lakh divided by 12. That time I'll end up issuing 1 lakh shares, which is right. Clear? If I divide by face value, I will end up issuing more shares. That means I'm giving more value to that person. They are supposed to get only 12 lakhs. If I divide by 10 lakhs, they'll get 1,20,000 shares. When they sell it, they will get 12 rupees per share. So they'll get 14,40,000 where they are supposed to get only 12 lakhs. Is it clear? So this is one thing you have to remember. Don't make the mistake over here. It is issue price, not face value. Clear? Next, issue of debentures. Issue of debentures. Second thing that we have to remember in shares, okay, or company accounts. Debenture issue might not be asked directly, but in your debenture redemption, it will play a role. If they are asking only debenture issue, it might be one 4-mark question. But in debenture redemption question for 10 marks, there can be debenture issue. Now, what is debenture? What is debenture? It's a debt instrument. It's like a loan, but not loan taken from bank. It is taken from public. Liability in the books of the company. It's a debt instrument. Company borrowing funds from debenture holders. It's a long-term borrowing. Now this rule you have to remember, okay, to pass the journal entries. This rule you have to remember to pass journal entries. Now, rule number 1. Current profit. If you have current profit, you should always record it. But how can I get current profit? By issuing the debenture at higher value. If I issue debenture at premium, then record it. That means 100 rupee debenture issued at 120. That means you're getting 20 rupees extra. Record it. Current loss. That means what? You're issuing the debenture at a lower value. Debenture issued at discount. Can you issue debenture at discount? Yes. Only shares can't be issued at discount. Okay. Face value 100 issued at 90. That means you're getting 10 rupees less. Record it. Future profit. That means in the future I'm getting profit. If future I have to get profit, that means I have to pay more or I have to pay less. I have to pay less. Pay less means debenture redeemable at discount. If it is redeemable at discount, do not record it. Future profits are ignored. Clear? But future loss means what? In the future, debenture is going to be redeemed at premium. You're going to pay extra amount and redeem the debenture. That time, debenture redeemable at premium, record it. That means future there is premium. Today only make a provision for it and get ready. Clear? So current loss, current profit we are going to record, future loss we are going to record, future profit we are going to ignore. Now we'll see all the 9 situations. First, face value is always going to remain 100 in all our examples. Okay. Debenture issued at par, redeemable at par. Debenture issued at par, redeemable at par. That means, do you have current profit or loss? No, it is issued at par, redeemable at par. Do you have future profit or loss? No, because it is redeemable at par. Nothing, you have to just pass the entry, bank account debited because you are getting money, to debenture application and allotment account 100. Now in the question, they might tell debenture also application 20, allotment 30, first call 50. If they do that, just follow the rules as you follow in shares. You don't have to do anything extra. Clear? If they don't tell, that means it is assumed that entire amount is received at once. Then you'll pass the entry, debenture application and allotment, then debenture application allotment account debited to debentures. Clear? Now, second, debentures issued at par, redeemable at discount. Do you have profit or loss today? No. Do you have profit or loss in future? You have profit because it is redeemable at discount. But future discount we are going to ignore. Therefore, same as first one. Same as first one. There is not going to be any change. Same what you passed earlier, you are going to pass now. But debenture issued at par, redeemable at premium. Today, is there any profit or loss? No. In future, is there any profit or loss? Yes, there is a loss. 100 rupee debenture, it is going to be redeemable at 110. That means 10 rupees extra. Now, what should be the entry here? Bank account debited to debenture application and allotment account because you are receiving the money. Always break down the entry into 2 parts. First issue, then focus on the redemption. Then debenture application allotment account debited to percentage debenture account. Clear? Now you pass the issue entry. Whenever you have to pay more in the future, when you have to pay more in the future, imagine you have to pay salary in the future. Okay, you have to pay salary, you did not pay it. Salary account debited to outstanding salary, that means expense account debited to outstanding expense. So you are going to write over here, loss on issue of debentures debited. Because losses are debited to premium on redemption of debentures. You are going to pay the premium somewhere in the future. That's why this becomes a liability. Whenever debenture is redeemable at premium, you will insert these 2 things into your journal entry. Whenever debenture is redeemable at premium, you will insert this into your journal entry because it is future loss. For that you are making current provision. Entry is what? Loss on issue of debentures account debited to premium on redemption of debentures. Is this clear? Now, next. 4. Debenture issued at premium, redeemable at par. Issued at premium. Today, are you getting profit or loss? You are getting profit today. In future, is there any profit or loss? Nothing. It's redeemable at par. So, today if you are getting higher value, where will it go? Securities premium. So, bank account debited 110 to debenture application allotment account 110. Then later on what is going to happen? Debenture application allotment account debited 110. But what you are going to transfer to debenture is going to be only 100. Extra 10 will go to securities premium. Is this clear? Now, if debenture is issued at premium, today do you have profit or loss? Profit. And in future it is redeemable at discount. Future do you have profit or loss? Profit. But this future profit is going to be ignored. That means your journal entry will be same as situation number 4. It will be same as situation number 4. Here we are following conservatism. Future profit. Only future losses we are recording. Okay. Now, debenture issued at premium, redeemable at premium. That means future do we have profit or current profit or loss? Profit. Future profit or loss? Loss. Now, issued at 110, redeemable at 105. Tell me one thing. Today, what is the profit? Future, what is the loss? What 5 is this? 110 minus 105. No, it is 105 minus 100. That means these 2 numbers will never be compared. Okay, issue price will be compared with face value. Redemption price will be compared with face value. Today you are issuing it at 10 rupees more, so 10 rupees profit. Future you are going to pay 5 rupees more, that is why it is loss. Is it clear? Now, otherwise you will start thinking, sir, I got 110, sir, but I have to pay only 105. That means 5 rupees I am making profit. No, today's profit 10, future loss 5. Net in the situation it is 5 only. Clear? Now, Bank account debited to debenture application allotment account 110. Next, debenture application allotment to debenture to securities premium. You pass the issue entry. Now, whenever you are going to redeem it at premium, what you are going to do? Insertion. These two things has to be inserted. Loss on issue of debentures to premium on redemption of debentures. 5. Is this clear? Next, debenture issued at discount. Today, do you have profit or loss? You have loss. Future, it is redeemable at par. Nothing. Today, if it is issued at loss, should you record it? Yes. Bank account debited 95 to debenture application allotment 95. When it is actually allotted, debenture application allotment 95. Now, even if it is issued at 95, what you should transfer to debenture account is 100 face value. So you are issuing it at lower value. That means that 5 will go where? Discount on issue of debentures 5. Discount on issue of debentures 5. Is this clear? Next.
Loss is under we should transfer to P&L.
Yeah, it will go later. Not now. It will go over the life of the debenture. If you transfer today, it will be like today's loss. But debenture life might be 5 years, 3 years. So over the life of the debenture will be transferred to P&L. Okay. Now, 8th one. Debenture issued at discount. Today, do you have loss? Yes. Redeemable at discount. Future, do you have loss? No, you have profit. But future profit, what you are going to do? Ignore. Clear? Therefore, today's loss only will be recorded same as situation number 7. Clear? Next, debenture issued at discount. Redeemable at premium. Issued at 95. Redeemable at 103. Today, do we have loss? Yes. Future, do we have loss? Yes. Both the losses should be recorded? Yes. Both the losses should be recorded? Yes. Okay. Now, tell me today how much loss I have? 5. In future, how much loss I have? Not 8, no? 3. Always compared with face value. First, you focus on issue. Forget about redemption. Focus on issue. Bank account debited to debenture application allotment 95. Clear? Then, debenture application allotment debited 95. Discount on issue debited 5 to percentage debentures. Did you record the issue? Now, what is the loss on redemption? 3 rupees. Insert it. Loss on issue of debentures debited 3 to premium on redemption of debentures 3. Loss on issue to premium on redemption 3. Is this clear? Yes. Now, once more topic. Debenture issued as collateral security. What does it mean? Bank is giving loan. We have to give some security. We don't have any asset to give as security. What we are giving? Issuing debenture only as collateral security. Today, this debenture is just a piece of paper. If they don't repay the loan, this debenture will become activated. Now, why are we worried about that? Because when company goes into liquidation, they pay in an order. The order is first you pay debenture holders. Then you pay other secured creditors. Then you pay unsecured creditor. So, unsecured creditor will be last in the list. So, if bank just gives loan without any security, if company goes into liquidation, they will be last in the list. But if they have one paper which can be converted into debenture, that time if at all bank goes into liquidation, if at all company goes into liquidation, what they will do? Loan is not paid. They will convert themselves into debenture. That time they will go and sit a little higher on the list. Is this clear? So right now is there any debenture? No. Right now debenture is given as security. Only when you don't pay, that person will become debenture holder. Otherwise is just a normal lender. Clear? Accounting wise, first thing is no entry. No entry. No need to pass any entry. Just go and write. Mention a note, long-term borrowing. Under long-term borrowing, mention a note that this has been issued as collateral security. Clear? You still feel that, no sir, I want to pass an entry. If you still want to pass an entry, what you will do? Pass a dummy entry. For no entry, if you are going to pass entry, it has to be a dummy entry only, no? So, you will pass the entry, debenture, suspense account debited to debentures. Can you see no effect? It is causing no effect. Debenture suspense to debentures. Is this clear? Now, discount on issue of debenture and loss on issue of debenture, both are expenses. You said that it should go to P&L. Yes, it should go to P&L. But if debenture is redeemable in lump sum at the end of the life, that means debenture is redeemable in lump sum means what? Entire amount is to be paid at once. If entire amount is going to be paid at once, then every year equal amount will be debited to P&L. If at all, let's say 5 lakh is our debenture and let's say it is issued at 4,50,000. Can you see that there is 50,000 discount on issue? This 50,000 discount on issue, let's say 5 years. So you will divide by 5 years. Every year 10,000 will be debited to P&L. Every year 10,000 will be debited to P&L. Clear? But in case debentures are redeemable in installment, it is redeemable in installment means what? First year you are paying something, second year you are paying something, third year you are paying something, fourth year you are paying something. So in that case, let's say I am paying 1 lakh every year. First year the value was 5 lakh, then it became 4, 3, 2 and 1. Every year I am paying 1 lakh. So when the fifth year gets over, it is 0. So now whatever debenture interest or whatever debenture loss or discount is there, you will do it in the ratio of 5:4:3:2:1. That means full 50,000 loss will go to P&L, but it will not go 10,000 per year. It will go in this ratio of 5:4:3:2:1. So just first one we will do 5/15 into 50,000. How much is that? It is 16,667. So first year 16,667 will be debited to P&L. Second year if you do 4/15, 13,333 will be debited to P&L. Like that every year the amount will be debited to P&L. You have 2 questions in the debenture chapter, the issue chapter, on just this. One question under this methodology, another question under this methodology. So very, very simple topic to like skip. If they ask, it's like easy. Where's your phone, man? Keep your phone in that desk. No. Keep it there. Next, interest on debentures. Tell me, interest on debentures means what? Debenture is a liability. We have to pay interest. Whenever you have seen the name debenture only, you would have always seen it like this. 8% debenture or 10% debenture. 1% is always written next to it. What is this percentage? Interest rate. Clear? So now, interest computed on face value. Interest is computed always on face value. Now, due entry. You have to pay interest or you have to get interest? Pay interest. So interest is expense or income? Expense. Interest on debentures debited. Whom should you pay it to? Debenture holder. But debenture holder only 90% and 10% is written as TDS payable. That means 10% goes to whom? Nirmala aunty. Correct, 10% will go to Nirmala aunty. But don't worry, it will go in whose name? Company's name or debenture holder's name? Debenture holder's name. If it goes in company's name, there will be 3 namas for debenture holder, right? Are you getting my point? What will he pay? That is what? No double tax. I'll tell you. Debenture holder will pay. We are talking accounting in the books of company. So the payment entry is debenture holder account debited, TDS payable account debited to bank. So can you see that they have paid the amount to Nirmala aunty? They have paid Nirmala aunty the amount. Now I'm the company or the debenture holder. Okay. Now how TDS works is, I have to pay you 100 rupees. How much do I have to pay you? 100 rupees. But I will give you only 90 rupees. I'll give only 90 rupees. 10 rupees I'll not put into my pocket. I'll take the 10 rupees and go and pay it to government. When I'm paying it to government, I'll pay it in whose name? Your name. I'll pay it in whose name? Your name. Clear? Now how much is paid tax in your name? 10 rupees. End of the year, you're calculating how much tax I have to pay to government. When you calculated, you got 13 rupees. You will not go and pay this 13. You will go and pay 13 minus 10. Already TDS was paid now in your name. So therefore, it is a win-win situation for Nirmala aunty as well as you. It is win-win situation for Nirmala aunty as well as you. Why? For you, end of the year, you had to arrange for the entire tax amount at once. But now, part by part, little it is going. So you don't have the burden of paying the tax at once. For Nirmala aunty, entire amount was coming at once at the end of the year. So for her to plan, it was difficult. But now she is getting little by little every time, every month. So it is easy for the government also because the regular inflow. For you also it is easy because the burden on you is reduced. You don't have to arrange at once. If I suddenly tell on one day that you have to arrange 10,000, that is difficult. But entire year, if you have time and you are arranging 500, 1,000 like that, then it will be easy. Clear? So double doesn't happen. Nirmala is not that rude. What did you think? Now, bonus issue is, Bonus issue. What is bonus issue? Now, we have Charan over here. Okay, this is the company. Charan is the employee. Charan is the employee. Now, company saw that Charan is working very hard. Is working very hard. So, company decided to give bonus. Bonus to Charan. Is this what is covered in this chapter? Is this what we are going to discuss in the next unit of company accounts? No. No. It is given to employees. We are not talking about that bonus which we hear. No. In corporate world, what bonus we are hearing, it is not that bonus. This is the bonus shares. Shares issued to existing shareholders for no consideration. We are giving shares to whom? Existing shareholders for what? Free. No consideration. Why?
It made more profit.
Yeah, they made extra profit. Major reason is see excessive profits. When company makes profits, it belongs to whom? It belongs to whom? Shareholders. Company, but they have to give it to whom? Shareholders. Now, when they are giving to shareholders, they can just distribute in cash. That is called as dividend. They can just give the profit of. Hello, madam. Here. Vision Nazi. Huh? Don't know. Eyes are about to close. Two eyelids, they were about to match like this. Little more if you would have dozed off, no. Then your nose would hit the desk. Then you would become Voldemort. No nose at all. Okay. Yes. Distributed in cash. Distributed in cash means what? We are giving dividend. Clear? Converted into shares. Additional shares. For shareholder, nothing. Now, profit belongs to you, right? Imagine profit is kept over there. Here, 100 rupees is kept. Okay, 100 rupees. You went to your granny's house. Okay, and granny had kept 500 rupees for you. Clear? To give it to you only. It belongs to you only. Granny had kept 500 rupees. This is dividend. This is dividend. It is distributed in cash. But your parents had first only told your granny, don't give money and spoil my kid. Correct? So that's why granny played it smart. She gave you Amazon voucher of 500 rupees. Correct? Did you get cash? No, right? So this is just like giving bonus shares. Instead of giving money directly, shares, extra shares you are giving to the shareholder. This usually company does only when they make excessive profit. Now tell me one thing. You heard that XYZ Limited is giving bonus. XYZ Limited has just declared bonus shares for their shareholders. Now this moment I tell this, your impression about XYZ Limited is good or bad? Good. That means company is doing good. That means in the stock market, after they declare bonus, the price of the share should go up or it should fall down. It will fall down. It will fall down. Not because of the company being bad. It is because of demand and supply. More supply, automatically the price will fall down. But don't worry, you will not lose money. Earlier, the price was 100 rupees. You had one share. Now you got bonus 1:1. Now you have two shares. Price has gone to 50 rupees. Your still value is, your value is 100 only, no? Are you getting this? Yes. Now bonus. Bonus has two things. What is it? Bonus issue and bonus call. What is bonus issue? I am giving you extra shares. What is bonus call? You did not pay the final call. It is not an arrears. It's not calls in arrears. I did not ask you only the final call amount. Now I am like, okay, let's do one thing. Why to ask you money, take money and then give you bonus shares? Instead of that, I will ask you money. You don't pay. I will only take the excessive profits and put it over here and make it fully paid up. Clear? This is called as bonus call. What is bonus shares? Issue of new shares to the shareholder. Bonus call is converting partly paid up shares into fully paid up without consideration. Without consideration means who is going to put money? Company. Clear? Bonus issue means shares issued to existing shareholders for no consideration. Only if shares are fully paid up. Only if shares are fully paid up, you can give bonus shares. If shares are partly paid up, you cannot give bonus shares. Now in the question, they tell you 10 rupee share, shares of rupees 10, 8 paid up. And they're talking about company issued bonus shares. Now what are you going to do? Are you going to write a note? If it is partly paid up shares, bonus cannot be issued. Done. 4 marks into the pocket. What you will do? First you will make the final call, collect the final call amount, make it fully paid up. Then you go and issue bonus shares. Clear? Yes. Now, journal entries for bonus issue. Only 2 entries. Simple. Remember, take the profit, keep it in the side. Like how your grandmother took 500 rupees and kept it in the side. Then that 500 rupees she converted into Amazon voucher and gave it to you. Clear? So take the profit, keep it in the side, convert it into share and give it to the shareholder. Taking the profit means profits have to be reduced or profits have to be increased. Profits have to be reduced. Profits have to be reduced means these profits have to be credited or debited. Debited because profit is reducing, profit should be debited. Clear? Now if it is going to be debited, there is an order. First preference always CRR. CRR account debited. From where will this CRR come? What is CRR? Capital redemption reserve, not cash reserve ratio, not capital reserve ratio, capital redemption reserve. When does it get created? From where is it coming? Capital redemption reserve? Balance sheet only. Okay. But how did it come into balance sheet? That means you didn't study the next unit. Okay. Only on redemption of preference shares or buyback of equity shares, CRR has to be created. CRR is capital redemption reserve. It will be created only when preference shares are redeemed or when equity shares are bought back. Basically, CRR will be created when share capital reduces. Share capital can reduce only because of 2 things. Pay the preference shareholder, that is called as redemption of preference share. Pay the equity shareholder, that is called as buyback of equity shares. This you will study at lunchtime. Let's not bother about that. This one is already there here only in the next unit. And CRR can be used for only one reason. For issuing bonus shares. Only for issuing bonus shares. Now something has only one use. Don't you think when you get an opportunity you should use it? That's why CRR is first preference. Second is securities premium. Why? Securities premium also has limited usage. It has only 5 uses. If you don't use the securities premium now, you might not get an opportunity very soon. So second is securities premium. After that, it is free reserves. Free reserves. What is free reserves? Reserves which can be used for anything. It can be used for any purpose. That's why general reserve and P&L. Now instead of general reserve, you debit P&L, still not wrong. Clear? You interchange the order between these 2 people, not a problem at all. I just wrote general reserve there because general reserve is older profits. So first you use general reserve, then you use P&L. Is it clear? 2, bonus to equity shareholders. Granny took the money and kept it aside to give it to whom? To you. Profit is taken aside and kept it for whom? To shareholders. That is why bonus to equity shareholders. When it is given, bonus to equity shareholder is gone and equity share capital increases. Equity share capital increases. Is it clear?
Both general reserve and P&L are given. We need to take first from general.
You take from general reserve, but in case you forget it and you take from P&L, still not wrong. You can take from both of them because both are free reserves. Securities premium collected in cash only. If it is not collected in cash, it's dummy, right? It will not be there. Okay, it will be collected in cash and all will be collected in cash only for you in the exam. Okay, because they are not teaching you about the alternative, no. So they are only talking about bonus issue. They are not talking the entire perspective of securities premium. Okay, so it will be collected in cash. You will see in the bracket always will be written collected in cash. Now, what is the entry again? CRR account debited, securities premium debited, general reserve debited, P&L debited. Only required you go to the next things. 2, bonus to equity shareholder. Then when it is given, bonus to equity shareholder debited, 2, equity share capital. Now bonus call. Bonus call means what? We are not giving shares here. Only we are making the full partly paid up share into fully paid up. Yes, Sharon. Partly paid up share we are going to make it into fully paid up. Tell me what is the final call entry? Calling the money. Equity share final call account debited to equity share capital. Correct? In the exam, unnecessarily you are losing marks by writing share call, share capital. Which share? That you write. You will lose marks. I am telling you will lose marks. You will not get full marks. Which share? They can fill it. There are 6% preference shares also. You just wrote share, right? So when it is equity, write equity only. So equity share final call account debited to equity share capital. What next? What next? What next? Usually what next? Bank to equity share final call. Now they are not giving money. We are only putting money. We are only putting money. So first to put money, take money and keep it aside. So general reserve account debited, P&L account debited to bonus to equity shareholders. Sir, two people went missing. CRR and securities premium automatically went missing when we came to bonus call. Why? Because they can be used only for issue of bonus shares. You can't use them for bonus call. Bonus call you have to take from the profit that is earned. So here only general reserve or P&L account will be debited to bonus to equity shareholders. Next it is bonus to equity shareholders to, no sorry, this is not equity share capital. Bonus to equity shareholders to equity share final call account. Because already 2 equity share capital has happened over here itself. This is the entry for bonus call. This also can be asked in the exam. Clear? Next, let's go further. Right issue. What is right issue? What is right issue? What is right issue? Oh, good morning. Oh, ho, ho. What is right issue? Shares given for consideration. To whom? To whom? Existing shareholders. Okay. Shares issued to existing shareholders for consideration. Now, why? We have a company. Four shareholders are there. They started the company. Clear? When they started the company, who put the money? Who put the money? They only put the money. Promoters, shareholders, they only put the money. Correct? Now they want more money. Now they want more money because they want to expand the business. They want more money. So they want to issue more shares. They saw outside 2 people are standing. Who is this? Bambani. Who is this? Narayan Murthy. Narayan Murthy and Bambani are standing outside. Clear? You thought, okay, they are anyway standing outside. We will ask them for the money. If you ask them for the money, then they will also become shareholders. Then they will also come and sit inside. On your head they will sit. Correct? If they sit on your head, over your decision making power is gone. So you want them to stay outside only. We don't want them to enter. They are trying to enter. Okay, they are trying to enter, but we don't want them to enter. If they enter, gone. Your power is gone. You are the people who started, right? You want to remain as the same shareholders only. So you want extra money. What will you do that time? You will ask these people only, do you want to invest more? They said no. They saw the market price. It was showing 25. They said no, we don't want to pay 25 per share. Then they said, okay, if you are going to invest, I will give it to you at 15. Some of them will be tempted. Correct? The shares issued to existing shareholders for consideration is called as right issue. It's called as right issue. Clear? Now entry is pretty simple. Bank account debited to equity share capital to securities premium. That's it. It is securities premium. Why? Because it's going to be issued at higher than face value. It is just lower than market value, but higher than face value. So this is the entry if there is a right issue. Now, there are some small chimp-into questions where they ask you value of right. They ask you some questions where they ask you to compute the value of right. Value of right, the formula is come right price per share minus X right price per share. What is come right price per share? Price per share before right issue. What is X right price per share? Price per share after right issue. Price per share before right issue has to be given in the question. How will we know it? But price per share after right issue, we will compute it. Clear? Difference between these two is called as value of right. Difference between price per share before right issue and after right issue. Now, how to calculate X right price per share? Formula looks huge, right? Formula looks huge. It is simple. It is before plus after divided by after. That's it. What does it mean? Number of shares before right issue into price per share before right issue. You got one value which was there before. Then from right issue, right shares into right issue price. You got the value which you got after. Total value you got now divided by total shares after right issue. So total value divided by total shares, you will get the price per share after right issue. If there is a difference, that is called as value of right. Right shares also, price is going to fall because of more supply. Price is going to fall, value is going to fall because of more supply. That difference will be computed as value of right. Clear? After this, we don't see right shares at all. Only basic, very absolute basic of right shares is taught to you over here. Next, you will see right issue at see the dinner time. You will not even see anything about right issue in lunch time. There is no issue of right shares and all. Okay. You will see right issue directly at dinner time. We'll see that time. One small subject is there called as AFM. Advanced Financial Management. Nothing is there. Okay. Huh? Nothing is there in there. We'll see at dinner time. What? Nothing is there in anything. In the name itself, it is there, Advanced Financial Management. But for that, little you have to learn financial management. That is there in CA Inter. After that, we'll think about everything. Now, redemption of shares. But what shares? Preference shares. Redemption of preference shares. Paying the money back to preference shareholder. How can you pay the money back to preference shareholder? From existing balance or from the profit or by issuing equity share. Sometimes what we will do, we issue equity shares. With that money, we will pay the preference shareholder. Clear? Now, journal entries are pretty simple. Due entry. When preference shares are redeemed at par. Par means what? Redeemed at face value. Now, what is going out? Preference share capital gone. To whom? Preference share holders. This is the due entry. Preference share capital reduces and we have to pay the money. To pay the money to whom? Preference share holders. So, this will be at face value. Clear? Preference share capital debited will always be at face value. Why? When you issue the shares, you are going to create what? At face value, right? At face value. When you are removing the shares, can you remove anything more than face value? I put 5 rupees into the pocket. Can I remove 6 rupees? Then it will become magic show, right? If I remove 6 rupees, then pigeon also I can remove. Correct? So therefore, preference share capital will be debited for only face value. Preference shares redeemed at premium. That means you have to pay extra. So preference share capital account debited. Premium on redemption of preference shares debited to preference share holders. You are paying extra. If at all face value is 100, redeemable at 100, then you will write preference share capital debited 100 to preference shareholders 100. If it is redeemable at 110, then you will write preference share capital account debited 100, premium on redemption account debited 10 to preference shareholders 110. Clear? Now finally, payment entry. The payment entry, preference shareholders account debited 110 to bank 110. Preference shareholders to bank 110. Clear? Now, transfer of premium. Premium is a loss. Loss should go to P&L. So, P&L account debited to premium on redemption of preferences. P&L account debited to premium on redemption of preferences. Is this clear? Finally, CRR. I told you, no. The CRR which you saw in the previous unit came from here. You have to create CRR. Simple, okay? Understand this. CRR will be created when the share capital reduces. When the share capital reduces, you have to create CRR. But what if I issue equity shares? To reduce this share capital, I didn't have money. So I had to issue equity shares. Now what will you do? Face value of preference shares redeemed minus face value of equity shares issued. Only difference I have to create CRR. Are you getting my question? So in the balance sheet, I had preference share capital of 100 and I have equity share capital of 50. So total share capital was how much? 150. I redeemed this. How much went? 100. So CRR how much you have to create? 100. Now when I am redeeming that, I made this one 80. I made this one 80. That means out of 100 which went, 30 has come in. So only 70 I will create CRR. Is it clear? So understand this. CRR creation is what? Take from one reserve and put it to CRR. So take from which reserve? Can I take from securities premium? No. When I am using randomly for random things, I can use only one, free reserves. Free reserves can be used for anything. So therefore, P&L or general reserve account debited to CR when there is reduction in preference share capital. Clear? Now, what is the formula? Yes, what is the formula? Over no pomegranate has to give us power. Tell me what is the formula? face value of preference shares redeemed minus face value of equity shares issued. Face value, only face value. Only face value you are going to look at. Now preference shares can be redeemed at premium also. Equity shares can be issued at premium also. But the entry will be face value of preference shares redeemed minus face value of equity shares issued. Why? Why? If preference share is redeemed at premium, if its preference share is redeemed at premium, it is not affecting share capital. If preference share is redeemed, I'm just saying if the sound is coming closer or sound is going far. If sound is coming closer means it may land on our building. Okay, going far means it will land on some other building. Okay, now preference shares are redeemed at premium. If it is redeemed at premium means what? If it is redeemed at premium, that means you are paying more. But the more that you are paying, are you taking from share capital? No. You are taking from where? You are taking from reserves and surplus. You are taking from reserves and surplus. Equity shares issued at premium means what? You got more. When you get more, are you going to put it to share capital? No, you will put it to reserves and surplus. Securities payment sitting under reserves and surplus. Clear? That means I am only bothered about what goes from here to create CRR. Now if I ask you how much money is required, even the premium I have to pay, money is required. But I am talking about CRR angle, only what goes out of this place. Is this clear, guys? Now, example you see, face value of preference shares redeemed is 100. Face value of equity shares issued it is 80. That means only 20 I will create CRR. Now, face value of preference shares redeemed is 200. Face value of equity shares issued is 300. That means there is no reduction in share capital. There is increase in share capital. If there is increase, it's a good thing. We will not bother about CRR. No CRR. CRR is only when there is reduction in share capital. Is this clear? Now, CRR can be used only for issue of bonus shares.
Scenario when authorized capital is exceeding the number of equity shares issued for preference share redeeming. So in that case, the what we do?
Authorized capital is exceeding or not exceeding? That means there is more authorized capital.
The existing equity shares is 80,000. So we can issue only 20,000 equity shares. But preference shares is redeemable about 60,000.
Then nothing. Then remaining you have to pay in cash. That means you have to create CRR. See, face value of preference shares redeemed, face value of equity shares issued. 60,000 preference shares are redeemed. Only 20,000 equity shares I can issue. That means 40,000 I can't issue. No problem.
They issue the 30,000 equity shares and the 10,000 as a CRR. In that case,
You can't issue. There is nothing called as issuing CRR.
no issue.
You will create 4 lakh of 40,000 of CRR.
Question is given issue 30,000 equity shares.
Okay.
In that case, that's the questions for that. That's why it's
So then you have to write a note. It's assumed that authorized capital is increased.
for
Yeah. In bonus questions also you will have questions. Now after bonus it's crossing the authorized capital. Then you write a note that it's assumed that authorized capital is increased.
notes to balance sheet.
No. Not notes to balance sheet. After notes to balance sheet you write a note for the reader. Not for the financial statement. You are writing the note to the examiner. It is assumed that all necessary resolutions are passed to increase the authorized capital. Otherwise you will be writing authorized capital less and issued capital more. Clear? Any case, see, it can happen only in 2 cases. One in bonus chapter and then in redemption of preference shares chapter. Whenever you are saying that after your question got over, when you are preparing that notes to balance sheet, no, your authorized capital is something, but your issued is going more than the authorized capital. Now increase the authorized capital so that it matches the issued and give a note. Some questions, they are only giving the note. It is assumed that all necessary resolutions are passed to increase the authorized capital. If they don't give that note, you have to still increase it and you have to give the note telling that it is assumed that all necessary resolutions are passed to increase the authorized capital. Because if you don't give this note, then you are wrong by writing the authorized capital less and issued capital more. If you ignore completely, that doesn't make sense because 8-mark question it is. So you have to do it and then give a note that authorized capital is increasing. That means you have to increase the authorized capital, then you have to give a note. Okay. Next, redemption of debentures. The last topic which you all skipped. Okay, which is called as redemption of debentures. Debenture is who? Yes, Pomegranate. Tell me, debenture is who? Yeah, but who is debenture? Public, who is giving? loan to the company. Debenture holder, that means you have to pay him back. If you have to pay him back, there are multiple options. One, pay in lump sum. 5 years, don't pay anything. At the end of 5 years, pay full amount. Second, in installment. In installment means what? Part by part, piece by piece, you pay. Correct? Conversion means what? You are not paying money. You will convert the debenture into shares. Purchase from open market, don't even bother. It's not there. It's a tool, but it's not there for you guys. Because to learn this, you have to learn AS 13. Accounting standard 13, which is not there at all. Only list of standards are given just for namesake in your material. So ignore the last part. The first 3 parts can be there in your questions. Clear? Lump sum means paid in full at the end of the term. Installments means paid partly during the term. Conversion means debentures are converted into equity shares. Is this clear? Now, accounting. What you did in preference share redemption, similar thing will happen here also. There, tell me, when you are redeeming preference share, what was the entry? Preference share capital account debited to preference share holders account. Here, debentures account debited to debenture holders account. If you are redeeming it at premium, there the entry was preference share capital account debited, premium on redemption debited to preference shareholders. Here it will be debentures account debited, premium on redemption of debentures debited to debenture holders. Is this clear? Next. The next entry, payment entry over there was preference shareholders account debited to bank. Here it is debenture holders account debited to bank. Then transfer of premium. There it was P&L account debited to premium on redemption of preference shares. Here it is P&L account debited to premium on redemption of debentures. Here instead of P&L, even securities premium can be used. Here instead of P&L, even securities premium can be used for redemption of debentures. But redemption of preference shares, you can't use securities premium. Is it clear? Now, if you have P&L, just use P&L only. Don't even think of securities premium. Conversion. Conversion means what? It is converted into what? Shares. First you pass the due entry. Debentures account debited to debenture holders. Debentures account debited. Premium on redemption debited to debenture holders. Clear? Next, after that, it would have been debenture holders to bank. But you are not giving money. You are giving shares. So, debenture holders account debited to equity share capital. In case the equity shares are issued at higher than face value, then even to securities premium. Is this clear? Now, DRR and DRR investment. Two things are there. DRR is debenture redemption reserve. First, you have to understand to whom it is not applicable. For listed companies, not applicable. For listed companies, not applicable. Unlisted companies, applicable. But in unlisted companies also, if there is banking company, NBFC, HFC and AIFI, not applicable. That means only the unlisted companies other than these 4, it is applicable. So if you see debenture redemption question, always they will tell you XYZ Limited, unlisted company, other than this. That means they are trying to tell you indirectly that DRR concept is applicable to you. Now, who is NBFC? Non-banking financial companies, HFC, housing finance companies, AIFI, all India financial institutions. All are financing companies only basically. Clear? For them it is not applicable because they have RBI regulations. They have Banking Regulation Act. There they have separate rules. So you don't have to worry about them. They will follow the rules anyways. So therefore for unlisted companies other than these 4, DRR rule is applicable. Debenture redemption reserve. That means compulsorily some amount you have to take aside and keep it. Now, rule is minimum 10% of outstanding debenture must be in DRR. If I have debenture of 500 rupees, 50 rupees should be in DRR. Now you're like, sir, what is the logic? What is the logic? 500 rupees I have to pay. I am taking 50 rupees and keeping it aside in DRR. But I have to pay 500. Don't you think full 500 I have to take it and keep it aside in DRR? What is the purpose of borrowing? If you take full 500 rupees and take it aside, like Charan took 1000 rupees from his friend, okay, to spend it. Okay, then he took full 1000 rupees and kept it aside thinking that I have to pay my friend back. Then what is the point of taking the money? Are you getting my point? So therefore, Companies Act told only 10% you take and keep it aside. This 10% is like you showing that there is an intention to pay. You showing that you are creating reserves so that at the end of the life of the debenture, you can pay the money back. Clear? So now creation of DRR will be P&L or general reserve account debited to DRR. Taking money, putting it into one reserve. Then after redemption, if DRR is still there, after redemption, what do? You don't need it, you reverse it. DRR account debited to general reserve. What is this, sir? When you remove from left pocket, but when you're putting it back to right pocket. Why? Because general reserve, and you see, you can remove from P&L here. But when you're putting back, you're putting only to general reserve, because you would have removed the money from P&L of some one year, 5 years ago. One of the years, 5 years ago, you removed from P&L. That means that year's profit got affected. When you're putting it back, you can't put it to that year's profit, no. So you have to put it to a place where that year's profit is also sitting. Where is that? General reserve. All the past year profits are sitting where? In general reserve. That's why when you're putting the money back, put it to general reserve. Is it clear? So this is what you need to know. And last topic is DRR investment. Just like they had a rule for DRR. What was the rule for DRR? Minimum 10% of outstanding debenture should be there in DRR. DRR investment is minimum 15% of debentures maturing during the year. That means if you have to pay back any debenture this year, then take 15% and it must be invested in safe investments by 30th April. You start the year on what date? 1st April. You are starting the year on what date? 1st April. When you are starting the year on 1st April. 1st what? 1st April. When you are starting the year on 1st April, you will make an analysis. No, this year who and all I have to pay? Good morning, yes. This year who and all you have to pay? Okay, you will make an analysis when you start the year. In that who and all you have to pay, if there is debenture holder, then before 30th April, take some money. Money is how much? 15%, and put it into some safe investment like FD. Don't go and put it in stock market. Then it will become zero at the end of the year, maybe. Correct? Put it in safe investment so that some money is reserved and kept aside to make the payment. So when you're making an investment, what is the entry for making an investment? Investment account debited to bank. Why did you make DRR investment? Why did you make this investment? So that money is saved to make the payment later. When you have to make the payment, should you still keep the investment? No, you have to sell the investment. So when you sell the investment, bank account debited to DRR investment. Obviously, when you sell investments and all, profit or loss will be transferred to P&L. Clear? Ultimately, this is the situation of debentures. Done, finished. All the concepts of company accounts are done. Now we'll go into problems. Huh? What time did you all come? What time did you come? You came at 8:30. What are you doing? Okay, take a lunch break and come back at 1:30. Yes, students, let's begin. Welcome back. Now, only thing that is remaining is for us to discuss the questions of company accounts. Company accounts questions we have to discuss. There are only few questions which we have to discuss. Very few. When we finish those few questions, we'll be done. Clear? Now, full focus. Question number 37, June 2023 exam. Now, BP Limited issued a prospectus inviting applications for 1,20,000 equity shares of 10 each at a premium of 2 per share. At what rate they are issuing? At 12. Now, understand this. How many shares they are issuing? 1,20,000. Now, application 3, allotment 5. 5 means this is basically 3 plus 2. Why is it 3 plus 2? Because 2 rupees is premium. First and final call 4 per share. Where is your phone? Okay. First and final call 4 per share. Applications were received for 3,60,000 shares. How many shares you received the application? 3,60,000 shares. That means, is it oversubscription? Yes. Applications were for 80,000 shares were rejected and money refunded. 80,000 you rejected, but basically other things you have to do pro rata only. Shares allotted to remaining applications were as follows. Category 1, 160,000, 80,000. That means what? For every 2 shares, they have given 1 share for every 2 shares. And 120,000, 40,000. That means for every 3 shares, they are given 1. 1 for every 3. Clear? Excess money received with the application was adjusted towards sum due on allotment and balance amount refunded to the applicants. That means if there is excess more than allotment, they are not adjusting with call. Only with allotment they are adjusting, balance they are returning it back to the applicants. Refund. Clear? All calls were duly made except a final call by a shareholder belonging to category 1 who had applied for 680 shares. His shares were forfeited. The forfeited shares were reissued at 13 rupees paid up. Past necessary journal entries for the above transactions. Open calls in areas whenever required, they said. Now, in this kind of a question, when you have pro rata, it's very important that you always make the table first. You have to make the table. When you have the table ready, then your calculations are simpler. Clear? Now, understand. 80,000 applications rejected. So, first category is 80,000. First category is 80,000. Clear? Then next category is what? 1,60,000 applications. 1,60,000. Third category is what? 1,20,000 applications. So 1,20,000. Is it clear? Now 80,000 category, number of shares allotted are 0. Number of shares allotted are 0. Therefore, amount received on application is how much? 80,000. This into application amount. Application amount is 3 per share. This into 3. That means they have received how much? 2,40,000. But amount required on application is how much? 0. Why is it 0? Because they are not allotted any shares. Now, amount adjusted on allotment is how much? 0. If you don't issue shares only, why will you adjust anything against allotment? Nothing. Refund. 80,000 was there. Understand this column. 80,000 was there. Clear? Amount adjusted is how much? 0. Amount required is how much? 0. That means full 80,000. I mean, sorry, not 80,000. 2,40,000. 80,000 is the number of shares. 2,40,000 is there. Did you require anything? Nothing. Did you adjust anything? Nothing. That means full 2,40,000 is going to be refund. Full 240 is going to be refund. Clear? Amount due on allotment, nothing. Amount received on allotment, also nothing. Next category is not so simple. 1,60,000 applications. Correct? How many shares are allotted? 80,000 shares are allotted. 80,000. That means on 1,60,000, you have received 4,80,000 rupees because into 3. But how much is required? 80,000 into 3. Only 2,40,000 is required. When 180 into 3 is 480, but 160 into 3 is 480, we require only 240. Do you agree that 240 is extra? 240 is extra. Now, what can you do? How many shares you are applying? You are applying only 80,000 shares. The allotment money is 5 rupees per share. So, on 80,000, the amount that is required for allotment is 4 lakhs. But out of 4 lakhs, we can adjust how much? Only 2,40,000. Extra how much you had? 2,40,000. How much you adjusted? 2,40,000. That means there is nothing for you to refund. Okay, but you adjusted how much? 2,40,000. But that amount required was how much? 4 lakh rupees. That means 1,60,000 is yet to be received. It has to be received later. Clear? The last category is 1,20,000 applications. 40,000 shares are allotted. So on 1,20,000 into 3, you received 3,60,000. But 40,000 into 3, you require only 1,20,000. That means extra whatever is there, okay, 360 minus 120, the extra which is there over here is actually 2,40,000. How many shares we are applying? We are giving 40,000. On 40,000, what is the allotment money? Into 5, only 2 lakh is required. But we have extra of 2 lakh 40. That means 2 lakh we will adjust and 40,000 we will refund. Is it clear? Whenever there is pro rata, this table, okay, maybe it's in a different form when you prepare it, no problem. But this table is required. That time your entry number 1 and entry number 2 will be easy. Tell me one thing. Entry number 1, what is it? Bank account debited to equity share application account. Can you tell me from here only what is the application amount you are going to write? 10,80,000. Not the amount required, the amount received. How much did you receive? 10,80,000. Clear? Next entry should be equity share application account debited 10,80,000. 2. Equity share capital 3,60,000. What is required will go to share capital 3,60,000. Extra you have. Some amount of extra you are adjusting. How much you are adjusting? 2,80,000. Sorry. How much you are adjusting? 6 lakh you are adjusting. With what? No, that is not the column. That is the amount required. 4,40,000 your amount adjusted on allotment. 4,40,000 you adjusted. So out of 10,80,000, can you see 3,60,000 will go to share capital and 4,40,000 will be adjusted with allotment. Correct? And that means remaining everything has to be refunded. That is 2,80,000 is refund. Can you see in the refund column 2,80,000? So because you made this table, all these numbers are readily available. Otherwise in entry number 2, you can't do so much calculation inside the journal entry. Is it clear? Now have a look at the entries. Bank account debited to equity share application 10,80,000. Equity share application account debited 10,80,000. To share capital 360. To equity share allotment 440. To bank 280. Is it clear? From here onwards, the number of shares that you're having is not 3,60,000. It is going to be only 1,20,000. You are going to do all calculations for 1,20,000. How much is allotment amount? 5. But in that 5, how much is premium? 2. So equity share allotment account debited. This is basically 1,20,000 into 5. Correct? To equity share capital 1,20,000 into 3. To securities premium 1,20,000 into 2. Okay, now bank account debited to allotment. How much you require for allotment? 6 lakhs. How much you already got over here and adjusted? 4,40,000. That means only 1,60,000 will be received. Somebody gave extra applications. That money we did not give it back. We told we will adjust it with allotment. Now when allotment money is due, you should adjust, right? 6 lakh is receivable. How much is already received? 4,40,000. That means how much will be received? Only 1,60,000. Is it clear, guys? Yes. Now, final call. Final call amount is how much? 4 rupees. Due entry. Equity share final call account debited to equity share capital. 1,20,000 shares into 4 rupees. 4,80,000. Simple. Now, did everybody pay final call amount? No.
600 shares.
How many shares they did not pay? How many shares they did not pay? Read that sentence. Not 680 shares. The one who had applied for 680 shares. The one who had applied for 680 shares. That means he did not get 680 shares. He got how much? 340 shares. Because 1:2, category 1. So 340 shares he has not made the payment. Is it clear? Which payment he did not do? Final call of 4 rupees per share. So when you are passing the final call entry, bank account debited will be 1,20,000 minus 340 into 4. If you take a calculator and check 1,20,000 minus 340 into 4, are you getting 4,78,640? Calls in arrears has to be opened, which was told in the question itself. How much is calls in arrears? 340 shares into 4. 1,360 to equity share final call. Now what we are going to do? We are going to cancel the shares. Now when you are cancelling the shares, we should always see whether the shares were issued at premium or par. It was issued at premium. If it is issued at premium, then we have to see whether the premium amount was received or not received. Received, because the premium is sitting at allotment stage. If the premium is received, what should we do? Premium should be ignored. That means entire focus will only be on 10 rupees. So now this will be 340 into 10 equity share capital debited 3,400. 2 calls in arrears. We already know calls in arrears is 340 into 4. Then share forfeiture will be 340 into 6. Actually, if you see, he has paid 3 rupees application and 5 rupees allotment. He has paid actually 8 rupees. But the 2 rupees premium is already sitting in securities premium. So don't go to reverse that. Only focus on the 6, which is face value part. Is this clear? This is forfeiture. Reissued at what price? 13 rupees per share. That means, is it issued at a premium? Is it issued at a premium? Yes. 3 rupees premium. So now it will be bank account debited 340 into 13. To equity share capital 340 into 10. 3 rupees should go to securities premium. So that will be 340 into 3. Are you getting this? Now, I told you when you complete the circle, what circle it is? Forfeiture and reissue. That time whatever is there in share forfeiture account, that should be transferred to capital reserve. How many shares it is? 340 shares. When we cancelled it, how much was the profit we made? 2040. That is basically 6 rupees per share. When we reissued it, how much loss did we incur? 0. No loss because it was reissued at premium. That means entire amount has to go to capital reserve. Entire amount has to go to capital reserve. Is it clear? These are the questions which are asked for 15 marks. It is 15 mark question in the exam. So don't ever make the mistake of skipping company accounts. Now company accounts, anything can be merged with anything. So don't think that one unit I'll skip and survive. No. Is it clear, guys? Any doubt with this one? No. Next. Next one will be December 2022 exam. December 2022 exam. Now you can see over here. Okay, past necessary journal entries in the books of PQI Limited also prepare balance sheet and notes to accounts of the company. Now, when we're going into that question, question number 38, we'll go in the order of the question. As and when you see the question, you should start passing journal entries. PQR Limited issued 2 lakh equity shares of 10 each, payable as 3 per share on application, 5 per share including premium. That means it is 3 plus 2 on allotment and 4 rupees per share on call. All the shares were subscribed. Okay. Money due on all shares was fully received except from J holding 5,000 shares who failed to pay allotment and call money. Did not pay allotment and call money. And Mr. K holding 10,000 shares who failed to pay the call money. So one person did not pay allotment and call money. One more person did not pay the call money. All these 15,000 shares, all the shares were forfeited. Out of the forfeited shares, 10,000 only reissued. If you remember study material, we have a question like this, which is based on Ram and Sham. Ram and Sham. When you are reissuing all of Ram shares, but Sham shares still something is pending. Okay, 10,000 shares, including whole of J shares. J shares, everything is reissued, but K shares, everything is not reissued. Okay, to L as fully paid up at a discount of 1 per share. Discount of 1 per share is possible because same share is going into another person's hand. Now understand this. Okay, when you are doing this, go in the order of the question. First, application, any problem? Somebody giving more money, somebody giving less money, any problem? No, right? Application, no problem. Problem arises in allotment. How much is the application amount? 3 per share. What is the entry? Application entry. Bank account debited to equity share application account. So now, can you see over here 2 lakh into 3? 6 lakh. Equity share application account debited to equity share capital account. 2 lakh into 3. Now, allotment. Allotment is how much? 5 rupees. Equity share allotment, 5 rupees. To equity share capital, 3 rupees. To securities premium, 2 rupees. So, if you see the due entry, equity share allotment account, 2 lakh into 5, 2 lakh into 3, 2 lakh into 2. Can you see this entry? Now, received. Did everybody pay the money? Who did not pay? J did not pay. J was holding how many shares? 5,000 shares. Anywhere in the question, can you see that they have asked you to open calls and arrears account? No. So, do this without opening calls and arrears account. That means out of 2 lakh shares, how many people paid? 1,95,000 shares, you got the money. Correct? So, here it will be 1,95,000 shares into allotment money is 5. Can you see the entry 9,75,000? Can you see they have given or in the suggested answers? If you are opening calls and arrears, then you will do 5,000 shares into 5. We'll go into calls and arrears. Is this clear? Now, 5,000 into 5. J is holding 5,000 shares. Now, first call or the only call, not first call, the only call that is there. Okay, the call, will you make the call for 2 lakh shares or 1,95,000 shares? Will you make it for 2 lakh shares or 1,95,000 shares? 2 lakh shares. Now don't make this mistake. Until and unless the shares are forfeited, when you go to the next stage, you will ask everybody for the money. Just because one person did not pay the previous amount, you will not stop asking him the money, right? You will ask everybody for the money. When will you stop asking? Only if the shares are forfeited. Is this clear? So now equity share call account debited to equity share capital 2 lakh into 4. 2 lakh into 4, 8 lakhs. Now did everybody pay the call amount? No. Who did not pay? J, who had 5,000 shares. K, who has 10,000 shares. So totally 15,000 shares we did not get the money. That means can I take it as 1,85,000 into 4. 1,85,000 into 4. That will make it 7,40,000. If you are opening calls in areas, how many people did not pay the final call? 15,000 shares. So 2 people, yeah, 15,000 shares. So 15,000 shares into 4. That will go into calls and areas. Is this clear? Till now only the calls are over. Now we are going to forfeit. When we are forfeiting, all are forfeited. All are forfeited. When you are forfeiting, you have to be careful little. There are 2 people, J and K. J has not paid the premium. Premium has to be reversed. K has paid the premium. A premium has to be ignored. Now when you are passing the entry, if you have a situation like this, you can actually pass the entry together. You can actually pass the entry separately. They have passed the entry together. Okay, I'll show you the calculation of how they have got it. Now share capital, everybody. 15,000 shares into 10. J 5,000 and K 10,000. Is this clear? Now securities premium has to be reversed for whom? Only J, because J has not paid the premium. 5,000 into 2. Clear? Now equity share allotment, who has not paid? Only J. So 2 equity share allotment account, 5,000 into 5. Call, who has not paid? Both have not paid. So 15,000 into 4. Is this clear? And finally, forfeited shares account. How are we getting this amount over here? J has paid what? Only application, 5,000 into 3. K has paid what? Has he paid application? Has he paid application? Yes. Has K paid allotment? How much is the allotment amount? 3, not 5. 3, because premium we are going to ignore. So plus 3, 60 plus 15, 75,000. Can you see how you are getting that 75,000? If at all the compound entry is confusing, you can do 2 forfeiture entries. One for J's cancellation, one for K's cancellation. When you are doing J's cancellation, J has not paid the premium. So premium has to be reversed. When you are doing K's cancellation, K has paid the premium. So ignore the premium, focus only on the face value. Can you see? Allotment is actually 5, but we are taking only 3 over here because only the face value part. Are you getting this? Yes. Now, are you reissuing everything? No, you are reissuing how much? 10,000 shares you are reissuing. When you are reissuing, you have to be a little careful. Bank account debited, this is 10,000 into 9 rupees because it is reissued at a discount. That means how much loss are you incurring? 1 rupee loss. So 10,000 into 1 is your loss and entire amount goes to share capital. Correct? Now I told you very clearly, only what has completed the circle, you will transfer it to capital reserve. J shares, how many were cancelled? J shares, how many were cancelled? 5,000. Did all 5,000 get reissued? Yes. So J shares, 5,000 shares were cancelled, and when it was cancelled, what was the profit company made? 3 rupees per share, because J paid only application, that was profit, 3 rupees per share. When it is reissued, how much loss did they incur? 1 rupee per share. 5,000 into 2, can you see 10,000 rupees profit for the company? On J shares. On K shares, how many shares of K were completed or cancelled? K's 10,000 were cancelled, but we are going to focus only on 5,000 because only 5,000 is reissued. Can you see? Including whole of J shares. Out of 10,000, J shares are cancelled, fully reissued. K shares, only 5,000 are reissued, but K's actual shares are how much? 10,000. So now here it is going to be 5,000 shares into how much profit did we make when we cancelled K shares? 6. 3 on application, 3 on allotment excluding premium. Okay, 6 minus 1, that means 5,000 into 5, we have made 25,000 profit. That means it makes it totally 35,000 has to be transferred to capital reserve. So your last entry should be forfeited shares to capital reserve. You are like, no sir, we could have done simple no. Sir, simple sir, we could have done like this. See, I'll tell you. We could have done here forfeited 75,000. Okay. Then here when it is reissued 10,000. Can't we do directly sir, that minus this? No. Because if you do that minus this, you are considering everything. Never calculate the amount transferable to capital reserve in totality. Calculate per share loss, per share profit, per share loss, net profit. per share profit, per share loss, net profit. Calculate like that only, because only the ones which have completed the cycle. What is the cycle? Forfeited and reissued. Only that you are going to consider. Is this clear? This was asked for 15 marks. Then they've asked balance sheet. Now old scheme, entire balance sheet was there. New scheme, they can't ask balance sheet because they've stopped focusing on balance sheet. What they can ask is the notes to accounts part. How much is authorized capital? How much is subscribed capital? Can you see when you're presenting this part, if there is any forfeited shares, that has to be added to the paid up capital. It has to be added to the paid up capital. How did they get this 30,000? Case shares, still 5,000 are there which are not reissued. Case 5,000 shares, how much is the profit? 6 rupees, 3 on application and 3 on allotment. That is the 30,000 which is still there, and that is going to be added to the paid up capital. Clear? Now this paid up capital, let me just tell you, whenever you're preparing the notes to the balance sheet, right? Paid up capital, if forfeited shares are there, that means forfeited but not reissued. That share forfeiture amount has to be added. It has to be added. If calls in arrears is there, it has to be subtracted. If calls in arrears is there, it has to be subtracted. Now see the bamboo. Where will the calls in advance go? It will not be added also. It will not be subtracted also. Calls in advance will be shown as a liability separately. It will not be added to capital. It will not be subtracted from capital. Calls in advance will come to the capital only when the amount is due. Are you getting this? Very important part of this. Otherwise, journal entries are pretty simple only. Now, every question which is chosen for share issue is for a purpose. I'll tell you the purpose so you'll know that when you cover all this, everything will be covered. Previous question we have learnt when there is pro rata and forfeiture in one question, what to do. In this question, we have learnt when two people's shares are forfeited and we are not reissuing everything, what to do. Clear? Now, next question. June 2022. Now, you know why this question is chosen? To calculate interest on calls in arrears and interest on calls in advance. Clear? That also can be asked for 15 marks. Give journal entries to record the transaction. Show the working of interest calculation. Clear? Now, A Limited issued 20,000 equity shares of 10 each at a premium of 10%. At a premium of 10%. Payable rupees 2 on application, 4 on allotment, including premium. Rupees 2 on first call and balance on final call. Now, application is how much? 2 per share. Allotment is how much? 3 is allotment, 3 plus 1. 1 rupee premium because they said 10%, right? Then first call is how much? 2 per share. 2, 3, 5, 5 plus 2, 7. So that means final call will be how much? 3 per share. Total amount is 10 plus 1. Is this clear? Now, understand this. All these shares were fully subscribed. Mr. M, who held 2,000 shares, paid the full remaining amount on first call itself. This question is also there in study material. In study material, this is called as Mr. Nair. It is called as Mr. Nair, paid full amount at allotment stage itself, but he is paying full amount at first call stage. Now, the final call which was made after 4 months from the first call was fully paid except a shareholder having 200 shares and another shareholder having 100 shares. Final call everybody paid. One person having 200 shares did not pay. One person having 100 shares did not pay. Is it clear? Now, they paid their due amount 3 months and 4 months respectively along with interest on calls in arrears. So, one person paid it, but after 3 months, one more person paid it, but after 4 months. Clear? Now, company also paid interest on calls in advance to M. Company maintains calls in arrears and calls in advance account. Calls in advance, how much is the interest rate? 12%. Calls in arrears, how much is the interest rate? 10%. Now, all this circus of calls in arrears and calls in advance is happening at first call only. At first call. Because till allotment, there is no problem. Are you getting this, guys? Till allotment, there is no problem. See, final call, see, Mr. M paid everything remaining at the first call stage itself. That means application allotment smooth, right? It's gone smoothly. How many shares? 20,000. How much is your application amount? 2 rupees. What should be the entry? Bank account debited to equity share application to equity share capital. Is that right? Yes. So can you see over here? 20,000 into 2. Bank account debited to equity share application to equity share capital. Clear? Allotment, is there any problem? Anybody paying more or anybody paying less? Nothing. So allotment, how much is the amount? 3 plus 1. 3 will go to share capital, 1 will go to securities premium. So now 20,000 into 4. But out of that 20,000 into 3 will go into share capital and 20,000 into 1 will go into securities premium. Did everybody pay the allotment money? Absolutely, they paid the allotment money. So bank to equity share allotment. Clear? Done? Are you following this? Now the problem starts actually. What happened at first call? Whatever happened at first call did not trouble us in the due entry. Due entry is normal. How many people? 2. What is the first call amount? 2. How many people? 20,000. So due entry will be 20,000 into 2 equity share first call account debited to equity share capital account. Are you following this? Now you have to be careful. Now you have to be careful. Mr. M is there who has paid everything. Everything means what? He paid first call also. He paid the final call also. First call is 2 and final call is 3. Now tell me one thing. Other than Mr. M, did everybody pay the first call? Other than Mr. M, did everybody pay the first call? Yes. Where is the situation where somebody did not pay at the final call? The person who is having 200 shares and 100 shares, they did not pay the final call amount. So now can I tell 20,000 shares into 2, everybody paid, plus Mr. M, okay, 2,000 into 3, he paid the final call also. Can you see the 46,000 here? So that 2,000 into 3 is calls in advance, and calls in advance is a liability. So 2 calls in advance and here 2 equity share final call. Is this clear? No. Is any problem with this? How to record calls in advance? No. Next we have to make the final call. When you are making final call, will you ask everybody or you will exclude M? You will remove M or you will ask everybody? You will ask everybody. Asking you have not done only, no. 2 things has to be done, no, in accounting. Due and receipt. Now only receipt has happened. Due has not yet happened. So the due has to be made. So now final call entry 20,000 into 3. Everybody are going to ask 60,000. Now who is not going to pay? This 200 shares they are not going to pay, and this 100 shares they are not going to pay. Do you agree? 200 shares and 100 shares they are not going to pay. Along with that, you know who is not going to pay? The 2,000 shares also. Why will he pay again? He already paid, right? So people who already paid will not pay. People who are not going to pay or who is going to pay in future will not pay. So remember, this is the present. Who has already paid will not pay. Who is going to pay in future will not pay. Remaining everybody will pay today. So now here bank account debited will be out of 20,000 shares. Mr. M will not pay because he has already paid. Somebody having 100 shares is going to pay after 2 months or something. Somebody having 200 shares is going to pay after 3 months. So remaining everybody will pay into 3 rupees. Are you getting 20,000 minus 2,000 minus 300 into 3? 53,100? Yes. Everybody is going to pay. Now calls in advance, which was advance, is no longer advance because now it is adjusted. So calls in advance has to go 2,000 into 3. Gone 6,000. Calls in arrears is somebody who did not pay receivable that you have to create. That means 300 into 3. 900 rupees. 2 equity share final call. Are you following this, guys? So bank account debited, calls in advance account debited, calls in arrears account debited, 2 equity share final call account. This is the entry. Now, no forfeiture. There is no forfeiture. We are going to calculate interest. Now tell me one thing. Interest on calls in advance will come first or interest on calls in arrears will come first? Advance, because advance is already settled today. We'll pay the interest. Arrears they are going to pay after 3 months and after 4 months. So when they pay, that time interest will be applicable or it will be due. Clear? Now tell me how much was the advance amount? 6,000. 6,000. How much is the interest on calls in advance? 12%. Correct? How many months? 4 months. How do you know? They said final call which was made 4 months after first call. Final call was made 4 months after first call. So into 4 divided by 12. 240. Interest on calls in advance account debited to shareholders. Better to write equity shareholders. Interest on calls in advance to equity shareholders. Is it clear? No. Next entry should be what? Next entry should be what? Pay the amount. Yes, interest on calls in advance to shareholders you have done. Due entry it is. Payment entry, shareholders account debited to bank. Shareholders account debited to bank. Is it clear? After that, actually, that interest should be transferred to P&L, which they have not done. Maybe they have done at the end. Interest has to be transferred to P&L. Now, tell me one thing. Interest on calls in arrears. Interest on calls in arrears. Now, first shareholder is what? Somebody having 200 shares. Another shareholder is somebody having 100 shares. The person having 200 shares paid after 3 months. Person having 100 shares paid after 4 months. So, 200 shares. What was the pending amount? 3 rupees. Correct? Into 10% into 3 divided by 12. 15 rupees is the interest for that person. Second person, 100 shares into 3 rupees into 10%. But when did he pay? After 4 months, 4 divided by 12. 10 rupees. Do you agree that the respective interests are this? Which interest will come first? 15 or 10? 15, because that's after 3 months. See the entry. Shareholders account debited because shareholder has to give you interest on calls in arrears. Then bank account debited. Why is it 615? The calls in arrears you will get 600 rupees and also the interest you will get. So totally 615 rupees you are going to get. So bank account debited, calls in arrears gone, shareholder due also gone. So total 615. Next, here this person has to give 10 rupees, but the amount that he has to give is 300 rupees. So next entry will be shareholder account debited to interest on calls in arrears 10. Repeat telecast again. Bank account debited 310. Why 310? 300 rupees the calls in arrears and 10 rupees the interest. 2 calls in arrears, 2 shareholder gone. They have not passed the entry, but in the exam to stay on the safer side, please pass the entry of transfer to P&L also. Interest on calls in advance is actually an expense. So better to write P&L account debited to interest on calls in advance 240, 240. Clear? And interest on calls in arrears is income for you. So please write interest on calls in arrears account debited 25 to P&L 25. How it is 25? One is 15, other one is 10. Is this clear? So every question is teaching you something new. Okay, or revising something new. First question was what? Pro rata. Second question was what? Forfeiture when there are two people and reissue. This what? Only pure interest calculation. Nothing is forfeited here. Next, let's go further. 40th question. 40th question also. The reason why 40th question is there is it is very unique and such questions are very rare in the study material. You know what? You like this. I'll tell you what you like. You like this. Somebody did not pay allotment amount. No problem. Somebody did not pay first call amount. No problem. Somebody did not pay final call amount. No problem. After that, we should forfeit. Correct? That is the comfort zone. The out of comfort zone is somebody did not pay allotment money. There only you are cancelling. Then somebody did not pay first call. There only you are cancelling. Then you are going into final call. Are you getting my point? That is not the comfort zone of the students. So that is the question that is asked in December 2021 for 15 marks. All are 15 mark questions only, by the way. Now understand this. Fashion Garments Limited invited applications for issuing 10,000 equity shares of 10 each. Amount payable was as follows. Clear? Now on application 1, allotment 2, first call 3, final call 4. Is there any premium? 1, 2, 3, 4. Nothing. 10 no. No premium. Issue was fully subscribed. Ram to whom 100 shares were allotted failed to pay the allotment money and his shares were forfeited immediately after the allotment. Are you getting this? So now till allotment there is no problem. Till allotment due entry we can reach. So 10,000 shares. What is the application money? 1. That means what should be the first entry? Bank account debited to equity share application account. Bank account debited to equity share application account 10,000 because this is 10,000 into 1. Next entry should be equity share application account debited to equity share capital. That is also 10,000 into 1. Done. Then allotment due entry. Equity share allotment account debited to equity share capital. But this will be 10,000 into 2. Did everybody pay you? No. Who did not pay you? Ram did not pay. Allotment, correct. And how many shares Ram has? 100 shares. Immediately forfeited into allotment 100 shares, correct. Now tell me one thing. What is the entry for forfeiture? Equity share capital account debited. Wait, we'll go to that. Equity share capital account debited. How much? 100 into. Called up. Yes, how much? Wait, what securities premium I heard in the between? That only, what are you saying? No. Good morning. Then, correct. 3. How much? Where are we? We are at this stage. Amount called up till now. 3. 1 he paid, 2 he didn't pay. We are cancelling. This is the one. Now, you know why? Without solving this question, if you go, you will be in the natural assumption that equity share capital debited will be always face value. You look at 10 and put 10. No 10, 3. Are you getting this? It's 3. Amount called up. 90% of the times amount called up is full. Now, 1,000 shares, sorry, 100 shares into what? Equity share capital? 3. What did he pay? 100 into 1. What did he not pay? 100 into 2. Is it clear? Allotment. Now see the entry. Bank account debited will be 9,900 into 2. Except Ram, everybody paid the money. 9,900 into 2. Are you clear? If with the calls and areas, without calls and areas, both the entries are given by ICA. You can follow any of them. If calls and areas is there, one new entry calls and areas will get added. Otherwise, it will remain in allotment itself. Now, listen. 100 into 3. Equity share capital debited. To share forfeiture, 100 into 1. To share allotment, equity share allotment, 100 into 2. Are you following this? Ram is out of the books already. Are you going to reissue? Last, not now. Are you going to reissue now? No. Go to the question. Can you see? Shyam, to whom 150 shares were allotted, failed to pay the first call. His shares were also forfeited after first call only. Now, let's go and ask everybody first call money first. Okay, first call money, let's ask. Next person in our story is Shyam. He did not pay what? First call. How many shares he has? 150 shares. Shyam has how much? 150 shares. Did not pay first call. But now we have to make the first call due entry. First call due entry will be for how many shares? How much is full shares?
10,000 shares.
No, 9,900. Ram, you already told buy. Already cancelled his shares. Cancelled share, how can I ask first call money? Are you getting my point? Cancelled share, I cannot ask first call money. If he has not paid first call, but I have not cancelled, I will ask him final call also. But he has not paid something and I am cancelling, then I can't ask him anything, no. So now when you are passing the entry for first call, it should be 9,900 into 3. 9,900 into 3, 29,700. Now, is everybody paying the money to you? No. Who is not paying the money? Shyam. So, 9,900 minus 150 into 3. That is 29,250. Is this clear? Shyam did not pay. Shyam did not pay. Now, will you wait further? No. Immediately cancel. Immediately cancel. Please tell me what should be the entry. Equity share capital debited for how many? 150 shares into what? 1 plus 2 plus 3. Called up is 1 plus 2 plus 3 into 6. Share forfeiture is what? 150 into 1 plus 2. He has paid application and allotment. And what he has not paid is equity share first call. 150 into 3. That is the first call amount. Clear? Now if you see here, 900, 150 into 3. Sorry, 150 into 6 and 150 into 3 is here and 150 into 3 is here. Equity share first call, equity share, share forfeiture. If you have open calls in areas, you know what to do. Instead of first call, it will be called as calls in areas. Is this clear, guys? Clear? Ram gone, Sham gone. Now how many? Let's see further what is happening afterwards. Second and final call was made. Mohan, to whom 50 shares were allotted, failed to pay the second and final call money. Seeing these, everybody is getting inspired. Seeing Ram, Sham got inspired. Now Mohan. Correct, no, Charan? Mohan, how many? He has not paid what? Second call. How many shares he has? 50 shares. How many shares he has? 50 shares. Please tell me, final call due number of shares. 9,750. 100 should be gone. 150 should be gone. Final call due entry. Final call due entry 9,750. Can you see 9,750 here? Into 4 rupees. Into 4 rupees. 39,000. Is everybody paying you the money? No. Who is not paying? 9,750 minus 50 into 4. Mohan is not paying. Minus 50 into 4. 38,800. Clear? If you open calls in areas, that will go to calls in areas. That shouldn't be a problem. Clear? Now, his shares were also forfeited. All the forfeited shares were reissued at 9 rupees per share, fully paid up. Now, how many forfeited shares we have? Ram, Sham, Mohan. Ram is 100, Sham is 150, Mohan is 50. That means you have 300 shares which are forfeited. Clear? 300 shares when you are forfeiting. Already forfeited. You don't have to pass entry again. It is already forfeited at respective stages. Now you are doing what? Reissue. Reissue it at what price? 9 rupees. That means how much is the loss on reissue? 1 rupee. So now your entry should be 300 shares into 9 rupees. Bank account debited 2,700. Loss on reissue 300 shares into 1 rupee 300. Then 300 shares into 10 rupees will go to share capital. Is that correct? Yes or no? Yes. Now, tell me one thing. All are reissued, right? That means Ram, Sham, Mohan. All have completed the circle. Correct? Now you have to cancel and now you have to transfer it to capital reserve. Now, Ram, you understand. How many shares are cancelled? 100 shares. When we cancelled, how much profit did Ram make? What Ram? How much profit did company make? He had paid only application money. Correct? Application money, 1 rupee per share he has paid. 1. On reissue, how much loss we made? 1. 1 minus 1. 0. Sham. How many shares Sham had? 150 shares. When we cancelled Sham share, he had paid application, he had paid allotment 1 and 2. So 3 rupees and loss is 1 rupee. That means 150 into 2 makes it. Then Mohan had 50 shares. How much is the profit when we cancelled his share? 1 plus 2 plus 3. Correct? 6 rupees minus 1 rupee loss on reissue. So 50 into 5, 250. Do you agree that totally 550 rupees still we have which we should transfer to capital reserve? Can you please tell me what is the entry for transfer? Share forfeiture account debited to capital reserve. Share forfeiture to capital reserve. Done. Clear? Again, it's not a problem. 15 mark question. Are you getting this? Charan? How are your one sister? 2 friends? Huh? What? She's in? That means she's not jobless. Imagine if you would have stayed at home. You would feel bored, no? Because she's in class. What would you have done? So you made the right choice. But you're the only person I'm seeing, man, who I'm finding hard to motivate to write the exams. Because usually I have to just tell that it's a good course, that this exam is coming near. This will have some different perspective only. He's like, what you were telling yesterday? He should not satisfaction or successful.
Virat Kohli example.
Virat Kohli example and all he gave. Virat Kohli can't come for Ganesh Chaturthi dance and all he told. What to tell after that? But whenever he sees Anushka Sharma in the interview, he gets angry. Virat Kohli should take his name. That is what he told. Huh? No, you told your name also. But still, ICU batch. With Accounts Marathon, you guys have discovered one person, which you failed to discover in the other 3 marathons. Seriously, man, these guys thought, okay, one silent person, innocent guy coming, sitting behind, attending marathon and going back. Innocent. Now, innocent and Charan, they don't go hand in hand. They go in opposite directions. Yes, guys. Next question. Yes. Now, listen, good morning. A limited issue, 25,000 equity shares of 100 each at a premium of 25 per share, payable as follows: application, allotment, and final call. Allotment, what did they tell? 50 including premium. That means, do we agree that it is 25 plus 25? Is it 25 plus 25? Everything looks very simple. Application were received for 29,000 shares. Letter of regret. Oh, sorry. Were issued to applications for 4,000 shares and the shares were allotted to all other applicants. Do you agree? It is oversubscription. Is it oversubscription? Yes. Do you agree that after oversubscription there is no pro rata? Yes. Rejected. Okay. Then Mr. A, holder of 150 shares, failed to pay the allotment and call money. Shares were forfeited. Show the journal entries. Only till forfeiture they have spoken. Reissue they have not spoken. So don't come to a conclusion in the exam that we have to do the reissue. They have given us the responsibility to do the reissue. No. Okay, only till forfeiture. Now tell me the entry for application. As you tell, I will go and look at the journal entries. You have to tell me the entry for application with amounts. Bank account debited, correct. 2. Equity share application account. How many shares? 29,000 shares into 50. That makes it how much? 14,50,000. Now you have to do the khulasa, correct? Yes, bank to equity share application 14,50. Correct? Next entry. Tell me what should be next entry. Equity share application debited how much? 14,50,000. To equity share capital how much? Application 14,50,000 only. To equity share capital how much? 25,000 into 50. 12,50,000. Remaining for 2 lakhs. Where will it go? Bank. It will be refunded. So can you see the entry here? Equity share application to bank 2 lakhs. Equity share application to equity share capital. They can just compound it and write it. No problem. After this in your life, there is only 25,000 shares. No 29,000 at all. Gone. Done. Finished. Now allotment entry. Tell me. Equity share allotment. Which allotment? Potato allotment. Equity share allotment account debited. 2. Equity share capital. 2. Securities premium. Because it's 25 plus 25. Equity share allotment to equity share capital to securities premium. Clear? Next. Are you getting money from everybody? Is everybody paying you? One person is not paying. Failed to pay what? Allotment and call money. So that means out of 25,000 shares, 150 you are not getting money. That means it is 23,350. Sorry, 25,000, 24,350. Very good. 850. 3 answers I wrote all wrong. Okay. 24,850 shares. Good morning. Yes. 24,850 shares. Into what? See over here. 24,850 into 50. Are you getting this number? 24,850 into 50. Didn't pay the allotment. No. You could have opened call center. Yes, that you know already. Now, first and final call. 25 rupees. How many shares? 24,850 into 25. No. 25,000 into 25. Never it got forfeited. Are you getting my point? See here. 25,000 into 25. Then did everybody pay you? No, that same person is not paying you again. 24,850 into 25. Clear, final call. Are we going to forfeit the shares? Yes. Are we going to forfeit the shares? Yes. Okay, 150 shares we are going to forfeit. What has he paid till now? What has he paid till now? Application. Now, listen. Whenever there is share issued at premium, you should think, is the premium amount received or not received? Not received. That means premium, what should we do? Should we tell high or buy? We should tell high. That means it should be reversed. Don't ignore it. Reverse. So now, debited, correct. He's talking debit and credit terms only. 150 into 100. Share capital debited. 150 into 25. Securities premium debited. Equity share allotment 150 into 50. Equity share final call 150 into 25. Share forfeiture. What has he paid? Only what has he paid? Only the application, which is 150 into 50. Are you able to get this? This is actually the simpler one of the 4 questions which we saw. Out of the, before this 4, they were having more complications. And this was asked for 15 marks in the exam. And they have given alternative solution with the calls and areas. That we already know, we are not going to see that. Okay, if calls and areas is there, what would happen? Instead of writing 2, you would have written, you will write directly 1 only. Clear? Yes guys, that's it. Done, finished. Share issue. Next we'll go into bonus issue. SM practice question number 1. Good morning to everyone. Good morning. Practical question number 1, bonus issue. Done, students. Ready? But I am not ready. What man? What are you doing? Yes, welcome back. Let's continue with bonus issue now. Bonus issue concepts and all we have discussed that time. We have one question in the PQ. That is, following items appear in trial balance of Saral Limited on 31st of March 2022. Okay, these are the things that are there. 4,500 equity shares, securities premium. Just now you were here, no? CRR, general reserve, profit and loss credit balance, correct? Company decided to issue equity shareholders bonus at the rate of 1 share for every 3 shares held. How many shares do you have right now? How many shares do you have right now? 4,500 shares. 4,500 shares into, see, you have not attended my regular class, right? If you had attended my regular class, you would have known this. Okay, I have this knack of seeing things. I mean, seeing people. At the time, they don't want me to see them. Okay. All this while, last 10 minutes, I didn't see you. That moment when you are putting that chocolate into your mouth, that time only I saw you. It is a manufactured defect. You can't help it. Okay. So that right time, I will see the person. She put the chocolate in the mouth. She was like this. That time only I saw many shares. She didn't know. Which chocolate did you eat? Huh? You didn't give her coffee, but everybody assumed that if they eat that, they'll be awake. But they're still sleeping. Okay. That is a scam. Huh? Oh, ad is like that? Oh, coffee but still has ad also? Oh. Oh, there is also a chocolate called Coffee Bite. That is actually more tasty. You can bite this. This is chewable, right? 5-star. Eat 5-star, do nothing. That's exactly what you guys are doing right now. Okay. But what? On what? Okay, no, applying too much of brain wala parts are done. Now it's like lighter parts of compare accounts. Okay, now again, Charan, tell me how many shares are there? Correct, 4,500. 4,500 shares, and bonus is issued in what ratio? 1 share for every 3 shares. 1 by 3. Can I tell that? That means 1500 bonus shares. Okay, 1500 bonus shares. Face value is how much? 100. That means 1,50,000 I require for bonus. Where will I take the money first from? CRR 70,000. Then where will I take it from? Securities premium 65,000. Still I am sitting at 1,35,000. Oh, good morning to me. Yes, 40,000. That means 1,10,000. After that, from where to take? How much? General is how much? 40,000. Don't take fully. Here you will take 40,000. P&L also you can take, no problem. You can interchange them. Both are free reserves, no issues. Clear? Now the entry should be what? CRR debited, securities premium debited, general reserve debited. 2. Bonus to equity shareholders. Yes. CRR account debited, securities premium debited, general reserve debited to bonus to equity shareholders. Then bonus to equity shareholders to equity share capital. Directly you can't pass. If you're thinking if I'll pass directly, you can't pass, you will lose, you will get half the marks. Okay. You will get half the marks. I'll tell you there is a logical reason also. It's not just that you have to give 2 entries. The logical reason is, for example, right now, HDFC Bank has announced bonus issue. HDFC Bank has announced bonus issue. Last month only they have announced. Clear? But the bonus will be issued on 25th of this month. August 25th is a cutoff date for bonus. Now, when they have issued, announced bonus, don't you think that day they announced bonus itself, they'll take the money and keep it aside? That means this entry is passed on the date of announcement. And this entry is passed on the date of issue. Are you getting this? In exams by default, what they do? 1st April they write and keep for everything. But in reality, nothing happens on 1st April. There's a lengthy procedure for all that. That's why chronologically when you're writing, there should be 2 entries. You might feel that this is credited here and this is debited here. So directly I can pass? No. Public? That will affect. But how is it affecting our journal entries? To issue bonus checks. Yeah, it will affect. See, they are only announcing and telling, no, I will give you bonus on this day. Listen. You are applying the logic or concept of bills of exchange over here. Bills of exchange, bill is drawn. Then you just add 3 months. When you add 3 months, by default, if you fall on public holiday, then you will take previous day. Here it is bonus issue is not like that. No, bonus issue company is telling, I will give you bonus. I am only choosing the day. So I will not choose a public holiday. No. I will choose a working day and tell this day I will give you bonus. It's not a default date, it's the chosen date. Are you getting this? Yes. Obviously, to give bonus, right? Listen, if it's listed company, if they have to give you bonus, it has to be a stock market functioning day, no? So they can't even give on Saturday, Sunday, no? It has to be a day when stock market is functioning, right? Because when they give bonus, it has to come and fall into your demat, no? So they can't give on any other day. Okay, that is PQ1. Let's go into PQ2. SMPQ2. Okay. Ready? Now look at the question. Yes, good morning. Can you hear me? No, nobody's sleeping. That means you are awake. Yes, good. Because when I told good morning, she didn't just stay like this and hope, let's hope it's not me. She was looking, who is that? Okay, that means she's awake. Yes, the following notes pertain to Bright Limited's balance sheet. Now, rupees in lakhs. Amount, the numbers are given in crores. ICA doing ICA stuff. You take 20 and multiply into 10 and write the wrong number in the exam. Because 20 into 10 if you do, you will get 200. You will not get 20,000. Are you getting this? Rupees in lakhs. But number is in crores. Let's make it into lakhs only. Just for our calculation. So that we don't mess it up. 20 crores is nothing but 2,000 lakhs. 2,000 lakhs. 10 crores is nothing but 1,000 lakhs. 2 crores is nothing but 200 lakhs. Now if you multiply, you're getting the numbers. 2,000 into 10, 20,000. 1,000 into 10, 10,000. 200 into 10, 2,000. Are you following this? When you do this, you will avoid errors. Because you have to write your solution rupees in lakhs only. You can't change that. It has to be rupees in lakhs only. Okay. Called up and paid up 10 crore, that means again 1000, and 2 crores, that means again 200. Called up and paid up. Can you see some default is there over here? Equity shares of 10, rupees 8 only paid. Equity share of 10, only rupees 8 paid. So can I think of bonus? First I should make the final call, then only bonus will come into picture. Now CRR is there, securities premium is there, general reserve is there, surplus is there. Clear? Now on 2nd April, you're feeling bad, no? Everything is on 1st April. So 2nd April. Okay, the company made final call on equity share of 2 per share. Sir. We thought bonus not required only. But they told first to make final call. Final call of 2 per share. Tell me the journal entry. I completely forgot. Equity share, final call account debit. Oh, like that. Okay. 2. Equity share, capital account. How many shares? How many shares? 2000, 1000, 1000. 1000. The called up and paid up part. 1000 shares. 1000 into what? 2 per share. 2000. Equity share final call to equity share capital 2000. Can you see? Next. Did everybody pay the money to you? Yes. Entire money was received in the month of April. So you will pass the entry. Bank account debited to equity share final call. Finished. Clear? Now is it fully paid up? Can you think of bonus? Yes. On 1st June, the company decided to issue equity shareholders bonus at the rate of 2 shares for every 5 shares held. How many shares we have? 1000. 2 into 2 by 5 is how much? 400. 400 shares. 400 bonus shares. What is the face value? 10 rupees. Into 10. That makes it how much? 4000. I need 4000 for bonus. Who will I trouble first? CRR. 1485 sorted. Then whom will I trouble next? Securities premium. 2000 sorted. So 3485 sorted. Correct? Then how much do I need? 515. I'll take from where? General reserve. 515. Is it clear? Now see the entry. CRR debited, securities premium debited, general reserve debited to bonus to equity shareholders. Bonus to equity shareholders to equity share capital. Is this clear? After that, notes to account you have to prepare. Just see the old number and subtract whatever you have done. You'll get the new number in the notes to account. That shouldn't be a problem. Clear? Bonus done. Bonus done. Bonus done. Oh. Now what do we have? Redemption of preference shares. Illustration 9. SM9 and SM8. What happened? AC not working, huh? Direction. Which direction you want? Pulla. Which direction is that? You have no idea how the AC works over there now. We'll experience it at 4:15. Amazing AC. No conflict at all. No conflict. AC is over here. 2 ACs are over there. Do whatever you want with that. Do whatever you want with that. This AC will always be on 16 and will be eating my face like this. See, I told him I have that skill. I was talking to others, but the moment you put chocolate in their mouth, I looked at. Yeah, again. Now which chocolate you put in your mouth? 4. What? Hey, you are actually unique, man. You know why? Because I was thinking about sugar, but you thought about cavity. Next level. 90% people would be thinking, okay, so many chocolates means so much sugar content, but you thought about cavity. One of your friend is dentist. Huh? He will send her to that doctor only and tell in the fees 20% is mine. 100% his one, you know, because ultimately he will make them spend. And at least for courtesy sake, he could have told they are kind friends. He is telling openly that I made them bakra. What should he tell? Okay, guys. Now, company accounts redemption of preference shares. SM illustration 9. Okay, illustration number 9. Good morning. Good morning. Good morning. Yes, let's continue. Few questions are there. We'll finish it off. And then you continue with your ICU. What do you have planned for the day? Self-study means okay, free time. Oh. Then next, after that, tomorrow exam you have. How much? 100%? 2, 3, 4, 5, 6. all children chapters, no? 2, 3, 4, 5, 6. Doesn't become 1/3. It's actually 50% of the syllabus. That means you will have one test only on partnership, I think. Okay, very good. Now listen, guys. What should your target be? 100, actually. Yeah. You should target 100%. Huh? 120 you can't score. Even if I target 120, I can get only 100. How can I target 120? By the way, in school and all you would have done, no?
Attending board one.
What is the use?
Attend everything.
Huh?
Try to attend everything.
Yeah. Yeah, mock test, yeah, but in real exam, first of all, you will not be able to attend 120. Yeah, but my point is why? My question is why? Here, because you should know everything. You should know everything because the one which you skip, if it comes in the exam, you should be able to answer. So here you should attempt all 120. I'm asking exam. The 100, don't waste time. You know why? Because in school, they used to pick the best. Here, they will pick the first 5. Last one, they will not even read. Imagine you as the person who is correcting paper. Why are you bothered? In school, your teacher is correcting your paper. Your teacher knows you. So they will pick the best. Right? Here, they don't even know who you are. Why are they going to waste their time? They finish correcting 100 marks, right? Last one extra question is there. They'll strike and go to the next paper. Are you getting my point? So they will not put in extra effort. You should understand people who are correcting, you should treat them like they know nothing. You should treat like they know nothing. So when you write short forms and all, no, remember, they know nothing. You write properly. When you write narration, when you skip narration, no, they know nothing. Give them the narration. Yes. Balance sheet of XYZ Limited as of 31st December 2021. Inter alia, alia but is also there in this question, includes the following information. Now, inter alia means considering all the above below information, okay? Yeah. Narration, wherever you see journal's brother, narration. Clear? Unless they tell in the question, ignore narration. Sometimes if it's a very big question, no, they tell ignore narrations in the question itself. Otherwise, write narration. Narration is like bakwas, man. You can write whatever you want. Okay. See, if your entry is wrong, narration is wrong. If your entry is wrong, narration is wrong. Imagine purchase goods from X. You have written the entry as purchase is account debited to cash. Purchase account debited to cash. Entry is wrong. Purchase goods from X should be purchase account debited to X. Entry is wrong. You have written the narration being goods purchased. Nobody will read that narration only. If your entry is wrong, why will they bother about the narration? But if entry is right, if I was a person correcting paper, no. When I see that being only, I would go to the next entry. Because I know you have written something. Clear? I would not bother. So there is a very less chance that your narration is wrong and they're cutting marks for that. It's not possible. Clear? Next. 50,000, 8% preference shares of 100 each. 70 paid up. Oh. What do we understand now? That means 30 not paid up means not called up only. But before that happens, I cannot do redemption of preference shares. Now 1 lakh equity shares of 100 each fully paid up. Securities premium CRR General Reserve Bank. That's it. Under the terms of their issue, preference shares are redeemable on 31st March 2022 at 5% premium. Preference shares are redeemable at what? 5% premium. In order to finance the part of redemption, the company makes a right issue of 50,000 equity shares of 100 each at 110 per share. Rupees 20 being payable on application, rupees 35 being payable on allotment, and balance on 1st January 2023. Is it clear? When are you doing the redemption? Tell me the dates in your life. No dates, only ICU, yes. When are you doing the redemption? 31st March 2022. Correct? Application, allotment, everything fine. But final call, when are you getting? 1st January 2023. What is the use of the pickle which is not there for the lunch? Are you getting my point? What is the use of the pickle which is not there for the lunch? This final call which is happening on 1st January 2023, is it going to help you for the redemption on 31st March 2022? Is it going to help you for the redemption on 31st March 2022? By the way, 2023 comes after 2022. Is it going to help us? No. So this is totally not required, the final call. Final call entry only you're not going to pass because you're going to pass journal entries on 31st March 2022. That time final call did not even happen. Are you getting this? Okay, now. Issue was fully subscribed and allotment on 1st March 2022. Money due on allotment were duly received by 31st March. Only that we require. Preference shares were redeemed after fulfilling the necessary conditions of Section 55. Section 55 is where you prepare CRR. Okay. You are asked to pass necessary journal entries. Ignore date column, they said. This also I have put here. This is actually not that question. That is actually illustration 10. We'll read that later. Illustration 10 we'll read later. This is illustration 10 actually. Now, illustration 9 you focus. How many right shares are issued? 50,000. When you are planning to go for a movie, will you go for the movie first or will you arrange the money first? Money first. So, redemption of preference shares. First you have to arrange for the money. Then you have to pass the redemption entries. Now, 50,000 shares. How much is it on application? 20. Correct? Application is 20. See the journal entry. This is only the due entry they have passed and kept, okay? Sorry, final call we have to make, no? Preference share 70 paid up it was. Preference share, final call account debited to preference share capital and bank account debited to preference share final call. How many shares were there? 50,000. This is nothing but 50,000 into 30 rupees per share. 50,000 into 30 rupees per share. Is it clear? Next, bank to preference share final call done. Next, application money. How much application money you are receiving? 20. So what should be the entry? Bank account debited to equity share application account. So this is 50,000 right shares issued into 20. Then equity share application to equity share capital. Then allotment is how much? Allotment is 35 including premium. No. 5 rupees is premium, right? Oh no, 10 rupees. Sorry. 10 rupees is premium. 10 rupees premium, so it is only 25 on allotment. So you will write 50,000 into 35 and to share capital 50,000 into 25 to securities premium 50,000 into 10. Bank account debited to allotment. Next entry. Can you see final call entry? They have not passed only. Can you see after this no final call? Some other entry is there. Final call entry is not passed. Are you following this? Now, what should be the next stage? Amount is arranged. Now you have to make the preference share redemption. Preference share redemption. Tell me what should be the entry. Preference share capital account debited. 35 lakhs. Correct? Sorry, not 35 lakhs. It has become 50 lakhs now after making the final call. 50 lakhs. How much is the premium? 5% premium. 5% premium means what? 2.5 lakhs. So total amount you have to pay is 52.5 lakhs. Is that correct? So tell me the journal entry. Preference share, 8% preference share, capital account debited, premium on redemption of preference shares debited, to preference share holders account. Preference share capital debited, premium on redemption debited, preference share holders account debited. Payment entry will be preference share holders account debited to bank account. Okay, preference share holders account debited to bank account. Next, what you're going to do, premium general reserve account debited to premium on redemption. It should go from P&L, right? But there is no P&L in the question. There is only general reserve, CRR and securities premium. That's why they have written general reserve account debited to premium on redemption. Now, how much CRR has to be created? CRR formula is face value of preference shares redeemed. How much? 50 lakhs. Minus face value of equity shares issued for the purpose of redemption. How much did you issue? You have to see the journal entries. How much did you issue? Here you got 10 lakh and here you got 12 lakh 50. Don't think final call only, because final call did not happen also. It's going to happen in the future. So do you agree that this is 22.5 lakhs? That means 27.5 lakhs I have to create CRR. See the CRR entry. General reserve account debited to CRR. CRR, don't worry about premium. See, preference shares are redeemed at premium. Equity shares are issued at premium. Both the cases, we are not bothered about the premium when you are creating CRR, because CRR face value minus face value. Premium on redemption went from reserves and surplus. Premium on issue came into reserves and surplus. So it's not impacting my share capital part. So share capital part, what went out, what came in. What went out, only face value. What came in, only face value. Is this clear, guys? Yes, that should be it with that particular question. But there is one small bumbo question, next one. With the help of the details in the above question, further assuming that preference shareholders holding 2,000 shares failed to make the payment of final call. Somebody did not make the final call payment only. Now, are you going to redeem them? 10, 10, 10, illustration 10. Somebody did not pay the final call amount. Are you going to pay? Are you going to redeem the shares? Hello, distributor here. Somebody did not pay the final call amount. Are you going to pay the? Are you going to redeem them? For what you came? Food is served later. Huh? You know in which chapter we are? See the screen and tell. In that bonus issue, man. Preference share redemption. Okay. Do you understand this? Preference shareholders holding 2000 shares fail to make the payment on final call. If they don't pay the final call amount, then I'm not going to redeem them. If I don't redeem them, then my CRR calculation also will change. That is the only change in this question. So when you see over here, illustration 10, see, preference share final call you'll ask everybody, but can you see here it is only 48,000 into 30 and 2,000 is calls and arrears. Then when you are redeeming, this is, okay, forget, they are forfeiting the final call, they are forfeiting the preference shares also, because they said assume that duly forfeited without, after giving proper notice. Forfeiture I'm not even going to discuss. Whatever you should write as equity, you are going to write as preference. See, preference share capital, calls and arrears, share forfeited. Clear? I'm not going to discuss that. Now, bank account debited to application. This will not change, no. Somebody did not pay preference share final call amount. Is it going to impact my equity share issue entry? No. This is same, this is same, this is same, this is same. Correct? Till allotment, everything is same. Now what's going to happen? CRR, what you are going to calculate is going to be different. Why? Because it is not 50 lakhs. Face value of preference shares redeemed is not 50 lakhs. It is only 48 lakhs. How 48 lakhs? 2000 not there. So 48,000 shares into 100, 48 lakh. Minus same 10 lakh and 12 lakh 50. So CRR amount also will be little lesser. Then your entire preference share redemption entries will all be different. Why? Earlier we did what? 50,000 into 10. 50,000 into 100. Now it's 48,000 into 100. And 48,000 into 5 and 48,000 into 105 to preference shareholders, then preference shareholders to bank, and this premium will go from general reserve also. Share forfeited, whatever is there, it will be transferred to capital reserve. Clear? Are you getting this? This was your illustration 10, but we have one more illustration to look at, that is illustration 8. Illustration 8. Okay. Have a look at this. Capital structure of the company consists of 20,000 equity shares of 10 each fully paid up and 1,008% redeemable preference shares of 100 each fully paid up issued on 1/1/4/2021. Doesn't matter at all when they issued. Now, undistributed reserves and surplus stood as follows. General reserve, how much you have? 80,000. P&L, how much you have? 20,000. Investment allowance reserve, out of which 5,000 not free for distribution as dividend, 10,000. That means how much investment allowance reserve is there? 10,000. How much investment allowance reserve is there? 10,000. 5,000 is not free. That means other 5,000 is free. That means you can use it for anything. Is this clear? Now, securities premium 2,000. Cash at bank amounted to 98,000. Preference shares are to be redeemed at a premium of 10%, and for the purpose of redemption, directors are empowered to make fresh issue of equity shares at par after utilizing the undistributed reserves and surplus, subject to the condition that a sum of 20,000 shall be retained in the general reserve, which should not be utilized. Now they told what? You use all the reserves. After using all the reserves, if at all shortage is there, that time I will issue equity shares. Clear? Tell me what is the face value of preference share redeemed? 1,000 shares into 100, 1 lakh. Correct? Are we redeeming them at par or premium? We are redeeming them at premium of 10%. Clear? Now, how much do I have in profits to create CRR? If I have entire amount to create CRR, then I don't have to issue equity shares itself. Now, how much do I have in general reserve? How much do I have in general reserve? 80,000. But they told that 20,000 shall be retained in general reserve. That means I can use how much general reserve? Only 60,000. Then how much do I have in P&L? 20,000. How much can I utilize out of P&L? 10,000. Why? Premium is there. Yes. That means 1 lakh on that 10% premium is there. That is 10,000. That means out of the 20,000 P&L balance, I can utilize only 10,000. Then we have investment allowance reserve. How much can I utilize? 5,000. So total amount I can utilize is 75,000. I can utilize how much? 75,000. So out of 1 lakh, if I have 75,000 to create CRR, that means 25,000 has to be filled, no? That means we have to issue equity shares for 25,000. Is this clear? This is the twist in this question. So now, if you look at the solution, bank account debited equity share capital 25,000. Then general reserve debited, P&L debited, investment allowance reserve debited to CRR 75,000. Preference share capital debited 1 lakh, but it's not redeemed at par, it's redeemed at premium. So premium on redemption of preference shares 10,000 to preference shareholders. Then preference shareholders account debited to bank. Then premium has to be removed from where? P&L. Is this clear? So all that you had to actually do in this question is to calculate and see how much equity shares. I'll tell you what exact errors you will do. By mistake, you will take general reserve as 80,000. You can't do that because 60,000 only you can take because they said 20,000 has to be retained in general reserve. By mistake, you will take this as 20,000. Forgetting that preference shares are redeemed at premium. If it is redeemed at premium, the premium will go from P&L. So when you go to create CRR, there is no 20,000 in P&L. There is only 10,000 in P&L. Then investment allowance reserve, they only told 5,000 is free. Okay, this should be the amount. Is it clear, guys? 45, redemption of preference shares. Okay, done. Now we have only one, 46, 47, 48, 49. 4 questions. From redemption of debentures. Redemption of debentures, which you all have skipped, right? You are doing the same thing what you did in partnership. Partnership, you are studying the tough parts, going to the last and losing focus on the chapter and going to some other chapter. But dissolution is damn easy. Company accounts, again, you are doing all the forfeiture, reissue, everything, and when you are reaching redemption of debentures, you are skipping that. And debenture redemption is damn easy again. Okay, now, illustration 1. Go to illustration 1. Ready off? Okay guys, let's begin. Illustration 1. Go to the end of the question and see. Write up the concerned ledger accounts excluding bank transactions, ignore taxation. Clear? Now, the following balances appeared in the books of company, unlisted company other than AIFI, banking company, NBFC, HFC. Why are they telling this Purana over here? They're trying to tell you that for these companies, DRR and DRR investment not applicable. For this company, it is applicable because other than these, clear? As on December 31st, 2021, 6% mortgage, 10,000 debentures of 100 each. 10,000 debentures of 100 each means what? 10 lakhs. 10 lakhs is the balance in debenture account. The balance will be to balance brought down or by balance brought down.
It's a liability.
Yes, to balance brought down or by balance brought down. To balance brought down or by balance brought down. It's a liability. Now tell me, to balance brought down or by balance brought down. That is what I said. After telling the correct answer, how can you tell the wrong answer? By balance brought down. Good morning. Very good morning. See, by balance brought down 10 lakhs. Can you see by balance brought down 10 lakhs? This will be doing today actually. Yeah. So if you all want to go, you can go. Because we'll be solving it in class. Okay, 10 lakhs. Clear? Now, next, debenture redemption reserve for redemption of debentures is 50,000. DRR is what? Asset, yeah, 50. Asset or liability? Debenture redemption reserve is what? How can reserve be asset? Reserve is always on the reserves and surplus. Reserves and surplus is on the liability side. You are not the debenture holder. You are the company. For company, reserve is liability because you have to give it to the owner or whoever it is kept for. Very good morning. Clear? Yes. So this will be in DRR account. Can you see debenture redemption reserve? Yeah, here it is. By balance brought down 50,000. Clear? Next, they have investments in deposits with a scheduled bank free from any charge or lien 1,50,000. What is this investment called? DRR investment. Asset or liability? Asset. Yes. So to balance brought down or by balance brought down. For balance brought down, what journal will you do? Investment account debit to
Bank.
balance brought down. What you will do? Journal, man. Balance brought down. Starting the ledger. Investment account debited. Yes, that is when it is bought. You have to write this, no? Huh?
Good morning.
No, I'm telling good morning to you. Yeah. What is investment account debited to balance brought down? Balance brought down, from there balance carried on became balance brought down here. For that, what journal entry you guys are inventing? No bank, nothing. Think first. No bank. First you think. Yes. Those are two different movies. Why are you talking about that? For balance brought down, good morning, there is no entry. It is just to balance brought down. That's it. Because last year you wrote by balance carried on. It is coming here and sitting. When transactions happen, that time you pass journal entry. Calculator is kept here from last 2 hours. What is the journal entry? What is the journal entry? Nothing, no? When I sell this calculator, is the journal entry. When I bought this calculator, is the journal entry. I kept it over here for 2 hours. What is the journal entry? Nothing. Therefore, when the balance is just sitting there, what is the journal entry? Nothing. It's just bringing the balance to this year. Is this clear? Yes. Now, bank balance with the company is 9 lakhs. So, bank also is an asset. I will only tell to balance brought down 9 lakhs. Okay. Next. Interest on debentures had been paid up to 31st December 2021. Where are we? We are also in 31st December 2021 only, no? Okay. No. We are right now in 31st December 2021. But on February 28th, investments were realized at par. Now, simple logic. Okay. If I have to redeem the debenture, first what I'll do? I'll sell the investment. I want to redeem the debenture. DRR investment it was. It was kept only for debentures. So, I'll sell the investment. When I'm selling the investment, if there is any pending interest, I will get the interest. Then I have to redeem the debenture holder. When I'm redeeming the debenture holder, if there is any pending interest, I have to pay him the interest. Then I'll pay the entire amount what I'm supposed to pay. Clear? So, realized at par and debentures were paid off at 101. Together with accrued interest. Why accrued interest? Because all our story was on December 31st. But we are going to pay on February 28th. Okay, February 28th. First, I have to get the interest. What is my investment? Before all that, no. Yeah. First, you have to check. Okay, DRR should be how much? 10%. DRR investment should be how much? 15%. Now, how much is your debenture value? 10 lakhs. So, DRR should be how much? 10%. That means DRR should be 1 lakh. So, DRR investment should be how much? 1,50,000. Today, I think PG food was very good. I can understand that. Food was very good in PG today. Correct, no? Yes. I can understand that. Okay, because you are in Amal. You know Amal? Okay, 1 lakh. No, it is not drunken people. Amal means you are on a high. It can be with food also. Yes, 1 lakh and 1,50,000. Is it clear? Now, this should be the minimum DRR and DRR investment. Do you have 1 lakh of DRR? You have only 50,000 of DRR. By default, you have to follow law first. Before starting the transaction, you have to follow law. You have to make this DRR 1 lakh. How will you do it? You remove from P&L and put it to DRR. So by P&L account 50,000. By P&L account 50,000. Clear? Is your DRR 1 lakh now? Yes. DRR investment should be 1 lakh 50. Is it already 1 lakh 50? Yes. You don't have to bother about anything. Now our question is, first I will go to sell the investment. When I go to sell the investment, the 2 months pending interest is there. No, Jan and Feb, I will get it. When I get interest, bank account will be debited. Can you see here 1,50,000 into 4% into 2 by 12. I got the interest. I got the interest. Is it clear? Now, did they make a ledger for that also? Interest received? No. No ledger for that. Now, after that, I will sell the investment. When I sell the investment, what should be the entry? Bank account debited to investment account. So, can you see bank account debited? 1,50,000 over here, debenture redemption reserve investment to DRR investment account. Investment is gone, money came. Done. Now what I should do? I should pay that pending interest which is there to the debenture holder. When I pay the interest, what is entry? Anybody, when I pay the interest, what is entry? Debenture interest account debited to bank. How much is my debenture value? 10 lakh. How much is the interest rate? 6%. How many months interest is pending? 2 by 12. 10 lakh into 6% into 2 by 12 is how much? 10,000. Is it 10,000? Yes. 10,000 is the interest I should pay. Tell me the entry for paying debenture interest account debited to bank account. Can you see debenture interest over here? Next, I will redeem the debenture at what value? At 101. If I am redeeming the debenture at 101, that means I am paying 1 rupee premium. So, debenture account debited. Debenture account debited, okay, for 10 lakhs. Premium on redemption of debentures debited for 10,000. Who should I pay all this to? Debenture holder. So debenture, okay, they have not made a ledger for debenture holder. To debenture holder 10 lakh 10,000. What is the payment entry? Debenture holder account debited to bank. Can you see in the bank account? You can see 10 lakh 10,000 gone. Okay. Then after that, premium should go where? Premium should go to securities premium or P&L. Can you see by P&L here? Interest should go where? Interest should, so that is debenture interest. This is also 10,000. Both 10,000s will go to P&L. Premium also loss, gone to P&L, debited to P&L, and interest also expense, it is debited to P&L. Done, finished. After doing everything, this should be balance carried down in the bank account. And what about DRR? What about DRR? Do we still need DRR? No, DRR you will transfer it to general reserve. End of story. Clear? You will transfer it to general reserve. This is how the debenture questions work. And it is damn simple. There are multiple ledgers, yes, but every ledger is having one transaction, two transactions. That's it. Clear? Next, we'll go into the next question. Here they only told you to open certain ledgers. What are the ledgers? Debenture account, DRR investment account, bank account, debenture holders account. Clear? As we read the question, all 5 ledgers should be completed. Now, following balances appeared in the books of Paradise Limited, unlisted company other than AIFI, banking company, NBFC, HFC. Why are they telling this Purana? I told you you should have attended regular class. Yes, HFC as on 1/4/2021. No, you sit. You came late, no? You had college, right? You sit. Yeah. Sit. Which? Preferential redemption. You watch, go and watch the preferential redemption basic video. Then don't come and sit at 4:15 and look like this only. Yes, is it clear? Now, 12% debenture, 7,50,000. Is it asset or liability? Liability. Is it to balance brought down or by balance brought down? By balance. Very good. By balance brought down. Debenture, liability. Good morning. By balance brought down, 7,50,000. Entire, see what you know how I am feeling. I am feeling like, okay. Now when you told 2 balance brought down, you know how I am feeling. There was one guy, okay, there was one guy. Handsome guy he was, okay, and good looking and nice, obedient fellow. So it was time for him to get married. So when he was getting married, no, he went to get married. He found, you already know this story, is it? No, right, okay. He went to get married. He found one very beautiful girl. He wanted to marry that beautiful girl only. But bride. Girl means bride. Okay. Boy means groom. Okay, he wanted to marry this beautiful girl. Now this beautiful girl is there. No, many people wanted to marry her. So there was a competition. He participated in the competition. He won it and he married her. Then he thought life is set. He can settle down. But because his father, no, stupid fellow, okay, he had multiple wives. To one of his wife, he had made one promise. Because of that promise, no, this fellow with his wife had to go to forest. Okay, had to go to forest. When he was going to forest, no, his brother, he could have kept quiet, kabab mein haddi. He also went. He also went with this guy to forest. When he went to forest, no, there he thought, okay, at least here I am getting privacy. I will stay in peace with my wife, newly married wife. I will stay in peace. But there also one foreigner came and kidnapped his wife. Okay, one foreigner came and kidnapped his wife and went. When foreigner kidnapped his wife, no, there also, listen, there also he told the foreigner, told his wife, he had some intuition that someone will come and kidnap. So, no, that is prequel. Now, actually everything because of this stupid brother. If stupid brother would not join with him to the forest, this entire thing would not happen. Stupid brother, he went and chopped the nose of that foreigner's sister. So now, foreigner came to take revenge. Now this fellow knew foreigner will come to take revenge. But when he went out, he told his wife, don't cross this line. Stay inside. But she saw one deer. When she saw one deer, no, she crossed the line and foreigner took and went. Now, after foreigner kidnapped, he was thinking how to find out where my wife went. That time, he saw one bird. He asked the bird. Bird told, one foreigner has taken your wife that side. Then he had to cross the sea. So much swimming he didn't know. So what he decided, he with the help of some monkeys, he constructed one bridge and went there. Then had a war and all and brought his wife back. After telling this full story, if you ask me what is the relationship between that guy and this guy, how you will feel, no? Like that only I felt when you told me again, two balance brought down. Did you understand now? Okay. Liability by balance brought down. What?
Yeah, story.
What do you mean? Because you don't know Tamil? Yeah, I know. If I tell it in single sentence, that even we tell. It's like you asking after entire Ramayana, what is Rama and Sita's relationship? If I tell that, there's no fun, right? But initially you were thinking, who is this? Only when forest story. Now he's thinking, who is that foreigner, right? Foreigner from Sri Lanka. Sri Lankan people. Okay, now listen. Shh. Okay, guys. You know, actually, one of my students from Chennai, right? He gave me one book. Okay, it is about Ravana in that. If you read that book, right, it is the entire perspective will be of Ravana in that. So you will not know actually who is the hero. Huh? In everybody's story, they are the hero actually. You should see, it is basically from whose angle you are seeing. And one more thing is, history is written by winners. So if you win, entire history is written by you. Like how US has written its full history. Like that.
Quote also. The hunter is always glorified until the lion knows to ride.
Knows to ride. Yeah. Hunter is always glorified until lion knows to ride. That's correct. So, as long as you don't know, you don't know. Correct? Simple. If you know, you know. No, that is a very deep sentence actually. Now nowadays you have this opinion, right? Whatever that old scriptures and all people have written, it is all bundle. Okay, lies. Actually, what you don't know is not lie. What you don't know is what you don't know. Until you can prove that what you don't know is lie, then it becomes lie. Until then, it's not lie. There is a logic. So people who know the logic. Otherwise, you just don't know it. That's all. Okay. Let's go further now. The debentures will have what balance? Debit balance or credit balance? Credit balance. Very good. Yes, 7,50,000. Next. Balance of DRR. Balance of DRR will have what balance? It's a reserve. It will have credit balance. I'll tell. Okay, it will have credit balance. Next. DRR investment is asset. That will have what balance? Debit balance. So DRR investment, can you see 1,12,500? 2 balance brought down. Next. Annual contribution to DRR was made on 31st March every year. 31st March 2022. Balance at the bank was 7,50,000. So bank balance is 7,50,000. But they told one twist there, before receipt of interest. That means natural assumption is that payment of interest is already done. Receipt of interest is not done. Payment of interest to debenture holders is done. Clear? Investment was realized at par. Debentures, redemption of debentures at a premium of 10% on the above date. Now, tell me one thing. Should we check some law?
Yeah.
Or 10% and 15%. So, there should be 75,000 in my DRR. And there should be 1,12,500 in my DRR investment. Is that correct? Do you have 75,000 in your DRR? No, you have only 25,000. That means you have to make another 50,000. And it becomes 75,000 by P&L. Then, do you have 1,12,500 in your DRR investment? Yes. So, no, nothing to worry about. Now, whenever you are selling, what you will do? Investments were realized at par. Interest was pending on the investment. How much is the interest? 1,12,500 into 10%. That makes it 11,250. Can you see 11,250 interest you received? Bank account debited to interest on DRR investment. Then you will sell the investment itself. So bank account debited to investment. Bank account debited to investment. Investment sold. After selling the investment, what will you do? You will pay the interest to the debenture holder. That is already paid. They have not spoken about it. Then what will you do? Due entry for redemption. Due entry for redemption is what? Debenture account debited. Premium on redemption of debentures debited to debenture holders. So debenture account debited 7,50,000. Premium ledger they have not asked. So premium also is debited to debenture holders. Next entry is what? Debenture holders account debited to bank. So you should find it in the bank account. Can you see 8,25,000? 7,25,000 plus the 10% premium, that gives us 8,25,000. Is it clear? Next, after that, balance carried down. Then finally, you have to eliminate everything. The DRR which is there, it is not required anymore. It will be transferred to general reserve. Apart from that, nothing. Debenture holders, see, debenture holders account. Clear? This is your illustration 2. If you get this in the question and if you have not studied and gone, you are the only person to be blamed. Because hardly in each ledger 1-2 transactions are there. Next, redemption of debentures, third illustration. Why this illustration is taken is because here conversion happens. They didn't ask you journal entries and all. You are required to calculate the number of shares issued and the cash paid for redemption of 20,000 debenture holders. Now see this question. XYZ Limited has issued, yes, Charan, XYZ Limited has issued 1,012% convertible debentures of 100 each, redeemable after a period of 5 years. Okay, no problem. 1,000 into 100, let me tell you, it is actually 1 lakh. Correct? Redeemable after 5 years. According to the terms and conditions, the issue of these debentures were redeemable at a premium of 5%. Whenever you are redeeming, you can redeem it at a premium of 5%. The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each. So, if I have 100 rupees to convert, 100 rupees of debenture, I have an option, 20% of this, I'll convert it into equity shares. Is this clear? Now, at a price of 20 per share and balance in cash, debenture holders amount into 20,000 opted to get their debentures converted into equity shares. Now, how much they can convert? Debenture holders of 20,000. Can they convert everything? No. Out of 20,000, they can convert only 20%. Every debenture holder can convert only 20%. So 20,000 is the value. 20,000 is the value. How much should I pay them? Will I pay them par only? Will I pay them premium? Premium. Debentures are redeemable at a premium of 5%. So 20,000 plus 5%. Can I see 21,000 here? 21,000. But 21,000, full 21,000, can they convert it into shares? How much they can convert? 20% they can convert into shares. That means 80,000 I have to pay them money only. 21,000 into 80% is how much? 16,800. 21,000 into 20% is how much? 4,200. Can they convert 4,200 into shares? Yes or no? 4,200 they can convert it into shares. What is the share value? What is the share value? Issued at what price? Share issued at the price of 20 per share. So 4,200 divided by 20. That means we are going to issue 210 shares. We are going to issue 210 shares. The question also was how many shares are issued and how much is paid in cash. Is that right? 210 shares and then 16,800 in cash. Is it clear? Last question in this marathon. We are not discussing anything after this. Last question, illustration number 4. Go to the end of the question. What did they ask? At the annual general meeting, it was resolved. This can be asked for 10 marks, by the way, in the exam. What? For what? See, man, people are like that. And see how you are. You will purposely stamp. Yes. To give existing shareholders the option to purchase one share of 10 rupees at 15 rupees for every 4 shares. What is this? Yes. To give existing shareholders option to purchase. Existing shareholders, you are giving option to purchase. What is this called? Right issue. Okay. Bonus is not giving option, just giving them free shares. Okay. This option was taken up by all the shareholders. How many existing shareholders are there? Authorized you don't see. Issued and subscribed you see. How many shares are there? 20,000. That means 20,000 shares. I am giving them 1 share for every 4 shares. So can I tell that 5,000 right shares? 5,000 right shares. Is that correct? 5,000 right shares. I am issuing it at what price? 10 na 15 na? I am issuing it at 15 per share. 10 of 10 at 15. That means face value 10. I am issuing it at 15. So it is issued actually at 15 rupees. Clear? Entry for issuing any share at premium. Bank account debited to equity share capital to securities premium. Can you see here? Bank account debited to equity share application to equity share capital, equity share securities premium. Clear? Next, what did they tell? To issue 1 bonus share for every 5 shares held. How many shares were there in the question? 20. But what did I do just now? 20 plus 5,000 shares I have issued. So I have right now how much? 25,000 shares. And how many bonus shares I am issuing? 1 share for every 5. Into 1 by 5. Can you see I am issuing 5,000 bonus shares? And shares there of 10 rupees. So it becomes 50,000 rupees I require for bonus. Whenever I need money for bonus, what do I look at first? I look at CRR. Do I have CRR in this question? No. Then what do I look at? I look at securities premium. Do I have securities premium in this question? No. Then I look at general reserve. Do I have general reserve? No. I have only P&L. So the entry for bonus will be P&L to bonus to equity share capital. Correct? So can you see? Oh, they have securities premium. From where they go? Just now. Just now we issued at securities premium, right? In the question it's not there, but just now we have issued. So this securities premium can be used. Securities premium account debited, P&L account debited to bonus to equity shareholders. Then bonus to equity shareholders to equity share capital. Done. So can you see right issue, bonus issue clubbed into one question, but the chapter is not that. Chapter is redemption of debentures. That has not yet started. Now can you see over here, repay the debentures at a premium of 3%. Now starting of this question you see. Can you see they said unlisted company other than AIFI, banking company, NBFC, HFC. That means DRR should be there. Okay. Can you see they have created P&L account debited to DRR? That you should first create, no? DRR should be there, no? Before you go into redemption. How much is the debenture value? Can you see 1,20,000? So 10% should be there in DRR. Create the DRR. P&L account debited to DRR. 15% should be there in investment. DRR investment account debited to bank. 15%. Clear? Then you go for redemption. Entry for redemption of debentures. Debenture account debited. Premium on redemption debited to debenture holders. Face value is 120. 3% premium on redemption to debenture holders. Is this clear? Premium is a loss that is transferred to P&L. P&L to premium on redemption. Debenture holders have to be paid. So you can find the entry debenture holders account debited to bank. Clear? Now, when you are redeeming the debenture, do you still need the investment? You don't need the investment. Correct? So bank account debited to debenture redemption reserve investment. After redeeming, do you still need the DRR? No, you transfer the DRR to general reserve. Is it clear? That's it. That is the question. With that, we are done with redemption of debentures also. Done now. You don't have anything else left. NP and all we have already finished. That should be it, guys. That's the marathon. Okay, now, yes. Format. Oh, what format? You wanted the details format and all, right? Right. Listen, right. Sit, man. Where are you going? Wait. Sit. Okay, incomplete. Listen. Write this. Incomplete records, right? You can have debtors ledger, creditors ledger. Just write this format so that you know these are the regular things. Extra things can be there. These are the regular things. Now, debtors account, you are going to write to balance brought down. Right, fast. To balance brought down. This is your opening balance. And then you will write by balance carried down. This is your closing balance. Clear? Then you are going to write to sales. This is your credit sales. Then you are going to write by bank. This is actually amount received. Then you are going to write by bills receivable. This is basically bill drawn. Okay, then you are going to write to bills receivable. This is basically bill dishonored. You can also write by cash. This is amount received in cash. By bad debts. That you already know. Okay, this is your debtors. These are the regular items. Okay, there can be more also. Adjustment of debtor and creditor can also happen. Now, bills receivable. Bills receivable account. To balance brought down. This is the opening balance. By balance carried down. This is the closing balance. Clear? Next, you're going to write to debtors. This is bill drawn. Then you're going to write by bank. Bill honored. Then you're going to write by debtors. This is bill dishonored. Then you're going to write by creditors. This is bill endorsed. Then you're going to write by bank and by discounting charges. This is basically bill discounted. I hope it's clear. Then after bills receivable, what is the next thing you require? Creditors. Creditors account, you're going to write by balance brought down. Okay, this is opening balance. Then you're going to write to balance carried down. What? By bank and by discount. What is? This is closing balance. And here you're going to write by purchases. What is this going to be? Credit purchase. Okay, to bills payable. Bill accepted. To bank. Paid amount. Actually in debtors I didn't write discount allowed and discount received. Discount allowed, that you should know. Okay, to discount received. Clear? If at all there is any deficiency, you can write 2 deficiency also. You're not going to pay, that means it's good for you. It's 2 deficiency. That is creditor, some of the regular items. Next you have bills payable. By balance brought down. This is the opening balance. To balance carried down. This is the closing balance. This is the closing balance. Is it clear? Next, to bank, amount paid by creditors, accepted, bills accepted. That's it. And you can write 2 creditors if it is dishonored. When you're having bills payable, you will not have too many things to think about. It's either paid or not paid. That's all. Clear? Debtor, if you have space in the debtors account, please write by discount allowed. In debtors account, by discount allowed. Provision for doubtful debts will not affect debtors account. I hope you know P&L account debited to PDD is the entry. Yes, that should be it, guys. Now you have how many days left? 28 days. That's more than enough. That's more than sufficient to clear the CA Foundation exams. Imagine if you are thinking that I need 3 months, 4 months and all for CA Foundation, it's not required because that is the amount you have to put in later in your life. If you take 4 months now, then think in CA final how much you have to take. 1 full year you have to take or 2 years you will have to take. Okay, so 1 month is more than enough, but this 1 month, no, you have to utilize in such a way that later you should not have regret. Are you getting my point? You should not waste time now and later think that maybe that 1-2 days which I wasted if I would have studied, it would have pushed me from 190 to 200. That shouldn't happen. Okay, go like full throttle. You know, when you go in vehicle and all, you go in full speed, like full throttle. That throttle sound should be heard. That grill sound should be heard. It's not going simply like in first gear without any sound. Second gear, before it makes the throttle sound, only putting to second gear. There is no fun in driving or riding like that. Correct? You should hear the throttle sound. Engine should make that sound. Correct? So you should put in your 100% effort. There should not be any, like they tell, no table should be left unturned. That means later you should not feel that, oh, that one thing if I would have done, I would have cleared. Are you getting my point? Regret is bad. Put in the effort now itself. Okay. And anyways, you guys have a schedule here of studying from 8:30 till night. That schedule you don't waste. You know what is the toughest part for most people? To get that schedule to study. Now you are forced to sit here, right? So now you have to study. After forcing you to sit here also, if you don't study, then it's your mistake, right? Are you getting this? So yesterday some people were complaining, telling that too much noise is there, nice use. I can't focus over there. Other people are talking. There are people talking. Don't talk, guys. I'm telling you, don't talk. You can have the conversation later. When you're having, most people, the problem is what, you know, sir, I can't sit for so many hours to study, sir. Now somebody is making you sit. Coming and sitting is the problem. Lot of distractions will be there when you want to think of sitting only. Now you are forced to sit. Now when you're sitting, please utilize the time. No. The tough part is done. You're sitting and it's not free. Are you getting my point? It's not free. You're paying a price for it. And you might feel, okay, like you might feel that actually money comes easily. Nothing parents give. But there is an effort which goes behind that money which parents are giving you. You're not getting it right now because you have not started earning. Okay. They might not show it. There are difficulties in every house. I'm telling you, there are difficulties in every house. Small, big, but there are difficulties. They will not tell you what are the difficulties. Are you getting my point? They're not going to tell you. Now you might tell, no, you're in ICU beds. Now suddenly you felt that you don't have some money, some extra expenses are there. You'll just call, right? You'll tell, I need money. Immediately money will come, right? It'll be arranged. So that money which is coming, there is an effort behind it. So don't neglect that effort. Okay, they have worked hard and you are sitting here comfortably. 12,000 for PG is not a small price. I'm telling you. Okay, 12,000 for PG is not small price. There are other places in Bangalore, you'll get the PGs for 6,000 also. Just that this area is expensive. Okay, so paying 12,000 for PG is a big amount actually. Okay, so don't waste that, whatever that amount you're paying, no, don't waste it. Ensure that you pass with flying colors. This is the journey which is going to start. Trust me, whatever struggle you have seen at foundation, right, it is going to boost your inter preparation. I'm telling you, I've seen people in ICU batch before who had not passed for like 1-2 attempts and all. Even 3 attempts, there are people who had not passed. But when they pass and they go to inter, right, they know what are the mistakes they made at foundation level. They are on day 1, they are how you are going to be in ICU batch. How you are in ICU batch, right, full focus, studying and all. They are like that from day 1 of CA inter class. That means whatever you are putting in effort, it's going to change the path. When you go to inter, you know right now, this is the way I have to study and you know ICA's level. And some of them have this thing, no, sir, if I failed in foundation only, do you think I can do CA? There is no connection. I'm telling you, there is no connection at all. Because foundation is a place where you didn't know ICA standard itself. You didn't know what they're expecting. Now you got to know what they're expecting. Now you know how to write. Simple. Now you have to study that way. BCom is not CA. Are you getting my point? And subjects like law and all, you should realize that business studies is not law. You have written a certain way in business studies and scored marks. Okay. If you have to ask me, you have written bakwas there. Okay. Literally bakwas you have written. If you had only 3 points in your head, you made it 10 and wrote 10 points. Are you getting my point? Now you can't do that. In law, you have 3 points in your head. You have to write only those 3. You can't make the 4th point also. Imagine you know that in your book 4th point is there. But you are remembering only 3. Write only 3. At least you'll get marks for that. You make that 4th bakwas point from your head, no, you'll lose marks. Impression of the paper is gone. Are you getting my point? You have to understand business studies is different. Law is different. There's a way to study law and write law. When you can do that, then law is also sorted. Okay. And accounts, please don't make mistakes, numerical errors. Lot of numerical errors. You know the concept, but when you're calculating, you're in a hurry. Okay. Now you have to become friends with your calculator for accounts. You can't take a brand new calculator and go to the exam. Gone. Okay. Entire thing is gone. You're taking 2 minutes extra in every solution. Trust me. You have to get adjusted to the calculator in such a way that if you want to calculate without even seeing, you should be able to punch the correct numbers. That is the comfort level you'll have to get with the calculator. Now, if you're not having a calculator, if you're buying a new calculator, I would always suggest Casio. Okay, because it has that feature of feather touch. There are some other calculators, when you press, you have to again see whether the number came or not. That shouldn't happen. That will not happen in Casio. Are you getting this? So, there are like 28 days. It's 100% possible. Again, please don't show me your face in CA Foundation class. Again, if you're showing me your face, we should meet only in CA Inter class. And after that, again in CA Final class. Okay, so CA Foundation, this should be their last attempt. Okay, still, if you feel that you have not started right now, okay, right now, don't even tell tomorrow morning I will start. Right now, if you start also, still there is sufficient time for you to comfortably pass. Okay. You have 12 hours in a day. Morning till night you are sitting half an hour, 1 hour lunch break. Take 2 hours. Take 3 hours gone. Take 4 hours gone. 8 hours if you utilize also. No, that's more than sufficient. Okay, that's more than sufficient. And these 8 hours are not by sleeping late or getting up early. You're getting my point. You don't have that struggle of sleeping late or getting up early. You can actually get up on time only. And you don't have to sleep late also. If you study here, after going to the PG, you don't have to study. Go and sleep. Because here you have the time to study, right? There you just go and rest. Is that clear, guys? Yes. Any more? You should be full focus, okay? Yes. And September 2025, you should all pass with flying colors. There shouldn't be any hassle. Don't take the examination pressure. In the exam, try to stay calm. Because moment you take pressure, you'll mess up 1 or 2 questions. And that messing up 1 or 2 questions will be carried forward to the other questions as well. This is clear? Yes. All the best. See you in the next stage of the CA journey. Okay. Bye. Study well.